Yes, let's begin straight away with the marathon. No beating around the bush. We are going to start about audit marathon, which has 11 chapters in the syllabus. But we'll be having targets on a daily basis. The marathon is for 3 days, right? Timing is, I think you already know, 8:30 to 8:30 onwards. Okay. Ending time you leave it to me. It's my call. Number one. Number two, we'll be having a daily target. We'll be meeting that as for sure. But in case if we meet it early, then we'll be taking the next day's target a little bit as well. Okay. So today's target is we'll have to finish off chapter 1, 11, 6, 2 and Karo. These are the 5 topics minimum we'll have to do it. So we will not move until it is done. Okay. In between, I'll give you a 1 hour lunch break and that should be good to go with it. And between 2 sessions, planning to have 4 and 4, but in between a 15 minutes break will be given to you and that is left to me as well. All right. Because you guys have exams in a month, so you don't get to choose break. You'll have to keep studying on a daily basis every day anyway. Okay. So before I begin with chapter number 1, we'll be talking with respect to certain basics of audit as to why we are doing the audit and what are the terminologies used throughout the syllabus. And once we study with this respect, then we'll not be talking about these things going forward in the other chapters. Okay. Yes. So let's begin with the first and foremost, the Bhagavad Gita of our syllabus. That is, what do you mean by audit? Now, before I begin audit as technical part of it, general sense also, we have done audit in our life throughout our life till date. But the only part that you're going to learn now here is as audit of financial statements, how we are going to do the audit. But apart from this, audit is nothing but in general sense, it is just checking and verification. So it could be your books, your notes for that matter, your study plan, anything and everything an audit can be done. But we will be sticking to only financial statements audit, right? So what do you mean by audit? It is an independent examination. Independent examination means our CA profession has been considered as a most trustworthy person when it comes to certifying the documents, financials and similar things. If you see accountant, a normal commercial accountant and a normal chartered accountant, whose signature has more value, it's always chartered accountants. Therefore, when a CA signs, there is no question about it with respect to the authenticity of the information. And for that purpose, there is one crux why they trust our signature is because we are independent. We do not budge to anyone's orders. We do not listen to anyone. We do what we want, right? So therefore, they call this examination only as what? Independent examination of what? Like I said, we are talking about audit is an examination, but in our syllabus, we'll be sticking to only financial information and not with respect to any other audit. For example, if you go to CMA, there more management and operational audit is more important. You become a CS, secretary audit is more important. Therefore, your secretarial standards, your compliances, those will be checked. In CA, we'll be more worried about financial statement audit. So it's an independent examination of financial information of what, which entity. It could be anyone. It could be individual. It could be proprietor. It could be partnership firm. It could be company. It could be a body corporate. It could be LLP, foreign company, anywhere, as long as you are an organization for us, whether profit oriented or not. My question to you is, if profit oriented, we understand that if we go and do the audit, whether profit is apt or not, whether it is presented properly or not. If it is not a profit oriented, then why we should audit them? The logic is because if you are not a profit oriented, people would have given you money as a trustee, and that money, whether you are using appropriately or not. Therefore, audit is not just with respect to the profit. Audit is with respect to objects, whether you have checked your objects rightly or not, whether you have ticked all the boxes or not, irrespective of its size or legal form. Size or legal form means either a small company also we do audit, large company also we do audit, dormant company also we can do audit, because dormant company, if you see, even they have accounting transaction, but the logic is they don't have significant accounting transaction. When such an examination is conducted with a view of expressing an opinion thereon, which means the ultimate objective of our audit, which in the next chapter we'll be seeing, ultimate objective of our audit is to give an opinion thereon. So this opinion can be very, very subjective. right? And in this subject, the most difficult part for students is you have given more freedom in this subject. There is no format, there is no formula in this subject. There is a lot of thinking to do, and we don't like the thinking to do when exams are in the corner, right? So opinion is very subjective in nature. There is no straightforward that Karthik sir gave this opinion. I think Akhilesh sir can give this opinion. Both opinions will be right from their perspective, and it is your call who should I believe depending upon the integrity of the auditor. And that is our next topic which we are going to learn about is ethics. So based on our ethics is what you believe. At the end of the day, our audit objective is nothing but going and giving opinion. To whom? To the one who has appointed us. Clear? That is with respect to audit. Now, there is one more part in audit hidden which we call as assurance. When you give audit, when you do audit, there is no audit without assurance. You have to have assurance in your audit. Although we call audit is a reasonable assurance engagement, what do you mean by assurance? If I tell you that I am assuring you this will happen, I am not promising you. And this is the general perception of students when they think assurance. Assurance is not a promise. Assurance is where I am giving you a confidence that, boss, I believe this is true. So I have checked it. So I believe this is true. And that belief is what I am passing on to you. So assurance is nothing but my satisfaction as to the reliability of an assertion. Now, what do you mean by assertion? Whenever assertion meaning comes into the picture, everywhere we talk about this assertion, what do you mean by this assertion? Assertion is nothing but whatever, in general terms, whatever management says. Now, whether management says true or false, that doesn't matter. Management says something, that is the matter for us. So, whatever management says, that becomes our assertion. Like, for example, sir, if management says we have got debtors of 1 lakh and we have made a provision for the debtors up to 10,000. Now, these both are assertions only. These both are assertions. So, therefore, I need to check whether the management assertion with respect to the debtor is actually 1 lakh or not. Is it 1 lakh or is it less than 1 lakh or is it more than 1 lakh? To check this assertion, we go and do audit of sales. Whether credit sales have been covered or not, whether stock has been moved or not, whether you have received payment or not. All these things, why do we check? Not because we doubt management, but we have to verify whether whatever you have told is true or not. The first assumption that you should burst in your mind is we never start audit with a doubtful mind. Why do we do audit, sir, then? Isn't it that we are doubting the management when we are doing audit? We are not doubting the management. We are just a representative of investors or the stakeholders outside. They don't believe management's information outrightly. That's why they want us to go and check. That doesn't mean we should doubt management. Clear? Number one. Number two, we never start our audit with doubtful mindset. Reason being is, do you know management? We do not know management. Are you aware about management is good or bad? We do not know whether they are good or bad. Are you aware about their transactions? We are not aware about the transactions. So what gives us the right to doubt management's integrity? Nothing actually. Therefore, we never start an audit with a doubtful mind. That is an investigator's job. Investigation always starts with a doubtful mind. Audit never starts with a doubtful mind. That is the reason why in audit we call the default opinion as unmodified opinion. Because our ultimate end goal is to give an opinion, we give unmodified opinion. Now what is unmodified opinion? Financial statements are free from material misstatement, and this is our default opinion. And if this is our default opinion, that means we never really bother about whether they are fraud or not from when we start our audit. Only when we keep doing the audit, when we identify certain circumstances, it is not as per what they have told, then we start thinking, okay, should we check more? Should we get into the details? And when we get to know that financial statements have material misstatements, we modify this opinion. Whatever default opinion we have, we modify that opinion. That is why we call it modified opinion. Meaning, we start with the unmodified opinion mindset only. So I don't doubt you. So whenever student comes into my class, I don't sit and doubt whether the student has studied or not, right? But when I keep asking questions, when I keep giving tests, that's when I doubt the student. Okay, I don't think the student has studied properly. Therefore, my procedure will change to that particular student. And that is why we call it unmodified opinion and modified opinion. Right? So assertion is nothing but whatever management says. Next, let's talk about provision assertion. They said 10,000 rupees. What if while checking, I got to know debtor is not 1 lakh, debtor is 2 lakh. 1 lakh worth of debtors, they have never recorded in the books of accounts, which means now they have lied to me. And if they have lied to me in first instance, my professional skepticism should click and I should ask more questions. And the moment I ask more questions, whatever answer they are giving, can I trust them? I can't trust. Therefore, I should verify their answer. Now, how do I verify their answer? By documentation. Therefore, should I trust oral more or written more? Written more. So, I need documentation for checking. Clear? Next. Assurance means what? My satisfaction with respect to reliability of an assertion being made by one party for use by another party. Here one party is management, use by another party is me. Until I get satisfaction with respect to the reliability of the information, I cannot pass on that satisfaction to someone else. If I do not have the reliability or satisfaction, I can teach you. How can I pass on the information to you? So first I should have the satisfaction as to whatever management has given me that information, it is correct. Only then I can give it to you. To provide such an assertion, the auditor should evaluate the evidence collected as a result of procedures conducted and express a conclusion. And this brings to our basic audit concept. Whenever we start our audit, we always want a data. And who gives us this data? The client gives us this data. And client could be management, could be trustee, could be anyone. From this data, what do we filter and pick? We pick information. And information is what we call as processed data. Now, client will give us n number of documents. We don't require that. Right now, when I say bank statement, client can give me 5 years bank statement. Why do I require 5 years bank statement? I don't require 5 years bank statement. Client will give because he doesn't know what I want, or he may not understand what I want. For example, a client could have taken loan in the financial year 1920 for 10 years. That means this will go till 29-30. Now we are in 25-26. Let us say this year I want documentation from the client. And I tell him, whatever loan you have taken, I want documentation of that loan as well. Now this fellow gives me financial year 1920 onwards bank statement. But is it required for me? I don't need that. But he gives it to me. So what I will do, from that, I will just note the date when the loan was taken. So I require the opening balance of the loan. And then I want closing balance of the loan of financial year 1920. I just require some information from whatever information he has given. I don't want everything in that pile of documents. Clear? So I will take information. What will I do with this information? I will take this information and I will check. I will examine the information. Now, how do I examine the information? By applying various procedures. Clear? Now, what is the outcome of the procedures? Is the evidence. Because without evidence, I cannot talk. For example, if somebody asks me, sir, can you please tell me about him, how good he is? How can I tell? For that, I should know him. I should have evidence with respect to what he is, how he is he good or bad to tell? I need the entire data about that particular person. So with this evidence, what will we do? After procedures, we get evidence. What do we do? We evaluate that evidence and we reach a conclusion. We evaluate this evidence and we reach a conclusion. And once we evaluate this conclusion, we reach opinion. Now, conclusion and opinion both are same answer. No. If it is same, why would I write it in two different places? So conclusion means what? From the evidence, what all we get as a result is called conclusion. But that conclusion need not be true, or that conclusion I need not give as an opinion. So I should evaluate that conclusion keeping qualitative aspects in the mind. Yes. Now, for example, imagine I have never lied. Okay. Now, in one of the instances, you got an evidence that I lied. Now, you have a conclusion that I lied. But what will be your opinion on me? It need not be that I am a liar. Now, you'll evaluate that Karthik sir has never lied. That means if he has lied here, somebody would have made him lie also. Therefore, when you evaluate that conclusion, your opinion might be different. And this opinion is what we give in the form of a report. And again, this also will be in writing only. And this report is what we call as audit report. And this audit report entirely is dealt in SA 700 series. That is chapter number 8 in our syllabus. Clear? Now, this is the entire flow right from where we start the audit until where we end the audit. We start from data, and if you see audit definition, what is our objective with a view of expressing an opinion thereon. At the end of the day, we come and give opinion only. Clear? You take any standard of our inter syllabus, it will be there in this particular flow itself. In your syllabus, we will never learn about review. We will never learn about prospective financial information. We will only learn with respect to audit, and that too generic form of audit and not specific of every entity audit. Clear? Yes. Although in the first chapter there is mention of review and prospective financial information, we are not really going to talk more about it after chapter number 1. All those things are covered in your ultimate level of CA, that is CA finals. Next, let's talk about engagement. Now, what do you mean by engagement? Engagement, generally we are not talking about the engagement that you guys are thinking about. When we say engagement, what is engagement? A work. Yeah, basically a work, an arrangement between two people. Now, what does this arrangement means? It could be any arrangement, sir. In the context of audit, what do we mean by engagement? Formal agreement between auditor and client. So there are two people here. It's a formal agreement between two people, auditor and client, where I agree to provide audit services. That means engagement, don't think it is just for audit. Engagement can be for audit, engagement can be for review, engagement can be for internal control review, engagement can be everywhere. But in the context of audit, what is engagement? It is nothing but an agreement between two people. What is that? Auditor and client, where we agree to provide some services in return for our fees. Clear? Do we do audit for free? We do, but not everywhere. Right? Once you reach your status of our vitamin M, then we tend to give things for free. So this particular letter or agreement is called as what letter? Engagement letter. Clear? Engagement letter. Then now let's talk about assurance engagement. We got to know what is assurance. We got to know what is engagement. What is assurance engagement? Assurance engagement is nothing but a work where my job is to improve your confidence. Clear? So it's an engagement under which a practitioner expresses conclusion. Why? To enhance the degree of confidence. What does enhance mean? Does that mean you don't have confidence? No, you have confidence, but my job is to improve or increase the confidence or give you more clarity with respect to the confidence, and that type of engagement is what we call as assurance engagement. Example, sir. Let's say there are students or you guys are investors of ArivuPro. Now, ArivuPro's financial statements you have seen, right? Now you are planning to take a decision whether should I invest more or should I invest less or should I recommend it to someone or not. The question is, when you read the financial statements, you have confidence. It's not that you don't have confidence, but there could be throughout the year, there could be some or the other news you would have read which makes you doubt little bit with respect to their future or with respect to their amount. For example, Lenskart IPO you would have heard. Yes. Why Lenskart IPO, people are having a little bit negative impression of that? Because there is one particular line item in their financials which they have given where their profits, their P&L income little bit has been shot up because of one reason where they sold their mutual funds, right, just before IPO. So when you sell anything that is your investment, you know in accounts, investment profit will always be credited to P&L account. Therefore, your income rises. Therefore, people are having a slight doubt that these people are making profit, yes, but is a profit from operating activities or not? Because if your profit is not from operating activities, how can I trust you? Yes. Similarly, how Zomato also people had reservations with respect to you're doing loss. Yes. So how can we go about it? Now imagine all these companies have not done their financial statement audit. What you would have done? People would have got fooled like crazy. They would have put money left, right, and center because window dressing, you're an expert in it. Forget about management. Your 11th, 12th balance sheet only if you take and see, will get to know how good you are at window dressing. Balance sheet is not tallying, increase one side and finish it off. Yes, you learned doing fraud right from your 11th and 12th. Imagine technically sound person what type of fraud you would have done. And that is exactly why for every company audit is mandatory. Books of accounts is mandatory. Yes, otherwise it will be like Byju's. Next 3-year revenue is recognized in the current year only. Therefore, delay in recognition or early recognition, it is early recognition, which will shoot up my profit. And I will show it to my investors. Look at my company. I am a humongous company. I am making super profits. Invest more. You give me money, then I will wind up the company with loss. Matter over. So how do we ensure that the outsiders believe you? They say, boss, I don't believe you directly. Let CA come and do the audit. In government, any case has any bias, what will they do? Hand it over to CBI. Why CBI you are handing it over to? Because of independent examination, because of the trust. Imagine now CBI also is biased. Now where will you go? Nothing, nowhere to go. You will have to suffer. Same logic here. When a practitioner gives a conclusion, that conclusion increases the confidence of the user. That does not mean I don't have confidence. See, if you don't have confidence also, you will get confidence. If you have confidence also, it will improve. Ultimately, it is positive effect only. And such type of engagement is what we call as assurance engagement. Of whom intended users other than responsible party. If management has prepared information, why are we doing audit and telling them it is good? They know it is good. So we are not there for telling management whether it is good or not. We are there to tell it to the users, the one who is using that information. It could be government, it could be shareholders, it could be potential investors, it could be anyone for that matter. It could be regulators also to decide on the law. Clear? About what? A result of evaluation or measurement of a subject matter against criteria. For example, let's take stock audit. When we talk about stock audit, we all know that if you remember bank audit chapter, if you are even in Karo for that matter, you are supposed to get an inventory audit done if your stock exposure from the loan for the bank basically is more than 5 CR. Yes. Now, if it is increasing 5 CR, we'll have to get a stock audit done, which is what bank says. Who will they appoint? They'll appoint chartered accountant only. Now, we go to a client's place. We don't know about the client. We don't know about the bank, but bank appoints us. So, we go. Who is a responsible party for stock valuation, stock information management? Who is using that information? Bank. But now, in between them, there is a doubt ka bridge. That doubt ka bridge I have to walk and clear. Whether the bridge is actually doubt bridge or no. Clear? So I go to the client's place. Yes. Now bank will tell, sir, this is what is my criteria. Go and check it. Now bank has given me the criteria or law has given me the criteria. I will go, I will check and I will report to the bank. Yes, it is as per the criteria or no, it is not as per the criteria. My job ends there. My job is not continuing after that. If bank asks, what should I do, sir? That's your call. Clear? I just have to go and tell, for example, imagine Naveen wants to get married. I just have to go and tell whether the family is good or not. Clear? Now, if Naveen asks, sir, should I get married? That is your call, pa. Understood? So, your decision I cannot take. My job is to help your decision making. Clear? So, technically, my job ends the moment I give my report. Keeping that report, you have to take a decision. Clear? That's called assurance engagement, where my job is to enhance a degree of confidence of whom? Users. Clear? Of what information? Prepared by responsible party. Then comes TCWG. We have the hierarchy in an organization. Who do we call this TCWG, sir? Clear cut hierarchy you should have. Now, if you see here, we have employees. Now, who is the boss for the employee? It is a management. Management means what? The one who follows the policies and procedures set by TCWG. And G in TCWG stands for governance. Now, what do you mean by governance? Making laws. So, this particular department of TCWG forms law, rules, policies, culture, right? Everything, the environment is set by these. And above them, there is one more role called owners. Now, understand, in an organization, we don't want to talk about employees here, because as an auditor, for me, the most important thing is these three. I am involved here. And that is exactly why in paper number 2, corporate law, qualification and disqualification of auditor, if my relative is there in the position of management or board, then I am disqualified. But if my relative is working as an employee, I won't be disqualified under section 141(3). Logic, because if you are here, then you can't influence my scope. But if you are anywhere in the ownership or TCWG or management, then you have the ability to influence my scope. You can stop me from working objectively. That is the reason why it is disqualified under Companies Act. Clear? So now the question is, there are 3 roles to play. Remember, it is a role, it is not 3 people. And this role can be played by one person. All 3 roles can be played by one person. That person only can be owner. He can only be TCWG. He can only be the management. Right? Example, proprietorship. In proprietorship, the proprietor only is the owner. He is only setting the rules. Who is executing that? He is only executing. Therefore, there are 3 roles played by one person. Or you can have 2 people play 3 roles. Who is that? Let's say TCWG and management separately, owners separately. For example, if you see KKR franchise, the owner is Juhi Chawla, Shah Rukh Khan, etc. But are they involved in proper policy making of which player should play how, who should play where, what? No. Now I can own a company and I can appoint people and say, you make policies there, you run it. I just want X percentage return. So there can be 2 people playing 3 roles. One is owner role, one is TCWG and management role. There could be another variation, owner and TCWG one role, management another role. Or you can have 3 people playing all 3 roles. Owner separately, TCWG separately, management separately. This brings more clarity to the job description. Reason being is, I can focus only on one thing. Clear? Generally, people want that to happen. So, what people will do, owners will be there. In most of the organizations, owners, I'm not talking about listed companies. Smaller companies, if I see, owner and TCWG, they would want to hold that particular position. But as and when you keep growing, your ownership dilutes. You go for IPO, you go for FPO. So ownership keeps on diluting. So owners will be different. TCWG management will be same at times. Sometimes ownership will be different. TCWG will be different. Management. In totality, how many roles are there to play? 3. Whether it is played by 1%, 2%, 3%, we don't bother. Now what we have to do then? We have to go and check who is playing what role. Reason, my communication matters. My communication is affecting because of your particular role that you guys are having. Clear? Now, what is TCWG? Jan 25 question. Okay. Very good question. Jan 25 is an epitome of CA Inter syllabus until now. Clear? So May 25, September 25, sorry, May 24, September 24, Jan 25, May 25, September 25. These are the 5 attempts that have been done. In all 5 attempts, topmost is Jan. Clear? When it comes to the conceptual difficulty of exams. Alright, Jan 25 tops the chart. Right? May 25 and May 24 is not that difficult. It comes at the end. Clear? September is an average, a moderate attempt where 50% of your conceptual testing is and 50% of the direct questions, easy questions have been asked. Clear? Jan is the one which is going to give you a real audit feel. But having said that, if you are by hearting, no, whether it is Jan, whether it is May, whether it is September, for you, CA will be come again. Reason being is, if you are not conceptually having the hold on the subject, then it will be very difficult to identify the question. Audit, by the way, from day one it is difficult. Clear? Without even knowing the subject, it becomes difficult. So this is how the subject goes. So have a classic clarity on concept. Okay. So TCWG, G stands for governance, and governance is the one where we take decisions based on that. So it could be a person, it could be an organization with responsibility for overseeing. Now, what is the difference between oversee and overlook? Overlook means ignore, oversee means monitor, yes, or supervise. So our role is to supervise strategic direction of the entity and obligations with respect to accountability of the entity. So we will be bothering about where the entity is headed. Number one, strategically. Number two, accountability. Anything happens in the organization, TCWG is the one who is responsible. Today, you behave something bad in the society, before blaming you, they blame your family. Yes, they blame your parents because they are the one who governed you. They are the one who oversaw you. Yes, so responsibility and accountability comes together. You can't say that I am responsible but I am not accountable for it. Responsibility and accountability is a couple. They come together. Okay. This includes overseeing financial reporting process. What is financial reporting means? FR means the way financial statements are prepared and presented. And that is what we call as financial reporting. How do we need to report whatever the transactions we have gone through? So the way we prepare the financials, the way we present the financials is what we call as financial reporting. Okay, right. For some entities, TCWG may include management personnel. Like I said, it is not a person, it is a role to play. Right. So some cases management only will play the TCWG role. Then comes management. What does management do? Executive. What does executive responsibility means? The one where policies are decided. Execution of that policy is what we call as management role. Clear? For example, let us say in a sales manager also will form part of management. Clear? Sales head of the entire department, sales head, is a part of management because he is the one who is executing whatever is decided by TCWG. Example, sir. TCWG decides that we will not give discounts in the entire year. For example, Louis Vuitton. Let's say Louis Vuitton TCWG decides that they never give discounts. Okay, the brand never gives discounts. These luxury brands don't give discounts. Imagine now the TCWG decided that our audience is a premium audience and we never give discount. Now, if the salesperson gives discount, it is breach of policy. Now, salesperson, you are there to execute what I tell. You can't decide on your own. The head of the department of that sale is a part of management. He has to execute it. He cannot decide on his own that we will give discounts to them. No, discount is not given if there is a policy set. Whoever is under that particular management, you have to execute what we have told. You cannot do anything else. Just like how our parliament is TCWG who decides on law, courts are executors where they just follow the law. They are not there to bring new laws. And that is why our audience at any point of time when court comes up with any decision, no, we are ready to put up social media posts because we do not know court is not supposed to make laws. Court is supposed to just follow the law. You want to make laws, then you have to sit in the parliament. Clear? Then, next, some here also if you see for some entities, management includes all or any of TCWG. Then comes the next topic, what we have to discuss with respect to is opinion. Now there are two types of opinion we'll have to talk about. One is called unmodified opinion and one is called modified opinion. Unmodified opinion means what? Where we say financial statements are free from material misstatement, and modified opinion where we say financial statements are not free from material misstatements. Clear? Now to understand this, let's understand the concept of misstatement. What do you mean by misstatement? Misstatement means there is a difference. There is a difference between two things, point A and point B. What is the difference? Point A says what you should have done. What you should have done. Now, what do you mean by what you should have done? I can't do whatever I want. I have to check my financial reporting framework or a law or regulation or standards. So whatever law says I should have done, whether have I done or not, that comes under point B. What you have done. What you have done. And this is management's action or decision. The difference between these only is called as misstatement. So misstatement is a difference between 2 points, what you should have done and what you have done. Example, let us say, they say if the law says you have to create a provision of not more than 10% and you have created a provision of 15%. Law says not more than 10, you have done 15, therefore you have done 5% more. Is there a difference? Yes, that 5% difference is what we call as misstatement. Now the question is, this 5% difference, law says 10, you have done 15, the difference is 5. This difference of 5% could be due to error or could be due to fraud. What is the difference between error and fraud? Error is by mistake, fraud is always intentional. There can never be a cause where you come and tell I did fraud by mistake. Fraud can never happen by mistake. Clear? That is called misstatement. Now, what do you mean by material misstatement? That level of misstatement which affects the user's economic decision is called material misstatement. For example, let us say the invoice says 10,054.37 rupees. How much you will enter in the books of accounts? 10,054. You rounded off it to the nearest digit. The question is there a misstatement here? The answer is yes. There is a misstatement. Misstatement of 0.37. But because of this, will your institutional investors, foreign investors, will they take money out of the organization and go home? No. Therefore, even though it is a misstatement, it is not a material misstatement. But if this was 37 crores, now it is a material misstatement. This can influence the users. Clear? But sometimes it is not about the amount. It is about what type of misstatement it is. If it is a fraudulent misstatement, I don't care about the amount. Clear? You lie about a small thing, it doesn't affect too many people, but you lied. That's the point. Clear? So many times misstatement is with respect to the size of the amount, but there are situations where misstatement doesn't care about the amount. It is about the behavioral aspect or reason why that misstatement came into the picture. Clear? Now, come back to the definition of modified or unmodified opinion. Unmodified means what? Financial statements are free from material misstatement. Modified means there are misstatements in the financial statement. They are not free from misstatements. Now, when we say this, here is what we call as best opinion in the audit. This is a best opinion, whereas modified is not the best. Not the best. That means there are 3 ways we can give not the best opinion. One is called qualified opinion, One is called adverse opinion and one is called, very good, disclaimer of opinion. Qualified opinion means what? It is good but not best. Adverse means definitely bad. Disclosure means, boss, no comments from my side. Clear? Now imagine which is the worst we can give disclaimer. Right? Imagine you go to the users and tell, I audited the company, but I have no comments on the company's financial statements. Now that scares the investors to the highest level possible when an independent person is going and checking and coming and telling that they don't have comments about the company. That's the worst decision that you can give. But again, management will not afford to go for disclaimer of opinion. Right? Very rarely will see disclaimer of opinion. At the end, they will settle for at least adverse opinion, but disclaimer they can't afford, especially if you're a listed company. At least unlisted company, private companies, they are okay with disclaimer of opinion because members are very limited. I need to convince only them. Clear? But if it is a listed company, it is a very, very rare scenario you will see disclaimer of opinion giving for a listed company. Clear? But yes, I think in everyday industries long back one disclaimer of opinion was given. Okay. Next, when you talk about this opinion, to reach this opinion, if you remember, we have to go through the entire process. So if we have to reach to the opinion, then we need conclusion, we need evidence. For that we require. Now let's talk more about procedures. What is procedure, sir? Procedure, when we talk about procedure, it is the way to perform examination. Way to perform examination. And there are two types of procedures. One is called as risk assessment procedure, further audit procedure. Now, what do you mean by risk assessment procedure? It is a procedure to understand three things. Entity, environment and internal control system. Therefore, we need to put up the right procedure in the place before we actually start the audit. This will tell us how risky is the environment. If the risk is more, automatically my further procedures will increase. If the risk is less, my further procedure will decrease. Therefore, risk procedure and further procedure is inversely proportional or directly proportional. Risk procedure and further procedure inversely proportional, directly proportional. If risk increases, further procedure increases. Risk decreases, further procedure decreases. Therefore, it is a inverse proportion relationship they have. Clear? So, it is nothing but procedures performed to obtain understanding of entity, environment and ICS. Why am I doing this? To identify and evaluate how big is the risk. Clear? And whether this risk is with respect to fraud or error. If it is a fraud risk, my procedure should be more. If it is error risk, my procedure will not as much as fraud risk. Okay? At the financial statement level as well as assertion level. Assertion level here, you can remember it as a transaction level, meaning root level. Root level also we should see, overall level also we should see. Example, sir. Imagine there is a plant whose leaves are rotten. Clear? Stem is having little infection. Where do you treat now? Do you treat the leaves and branch or do you treat the root first? Now, root level if we take care, automatically the upcoming leaves and upcoming stem branches will be healthy. But whatever is there now, I need to check both. I need to check the top level also. I need to check the root level also. So, both level when we put procedures, the fruit coming out of that plant would be much, much sweeter for us. Clear? What is further procedure? Designed to get more evidence based on risk assessment procedure. So, if risk is more, I require more evidence. If risk is less, I will require less evidence. If risk is fraud risk, then I would require more evidence. If risk is error risk, I would require less evidence. Why is that, sir? Why in case of fraud it is more, in case of error it is less? Because fraud is a sophisticated crime. They will know everything. They'll hide purposely. Whereas error, there is no need to hide. It will surface when we check. Clear? Now, in that also you tell me, fraud risk is more, management fraud is risk more, or employee fraud risk is more? Management fraud risk is more, because employee, if he does fraud, management will find out. If management does, who will find out? No one. Clear? That's why we have to pitch in, right? The one who creates internal control only can breach, right? That's the reason why management fraud risk is more risky. Internal control system is a next topic. ICS, what is internal control system? It is a process. Process means what? Series of systems or activities which is designed, implemented and maintained by whom? By the top level, that is TCWG, management and other personnel. Why? To provide reasonable assurance about what? Achievement of the entity's objective. Basically, you have an objective. To reach that objective, you require a medium, and that medium is internal control system. Without ICS, there is no achievement of objectives. Only thinking of objectives will be there. You want to become a CA. You decided, you got up, you became a CA, you went back to sleep. Is that how it works? No. Or does it work like CA Foundation, CA Inter, CA Finals? No. You'll have to study. You'll have to put up a timetable for that. You have to have a discipline for that. You need to do a writing practice. You need to do revision. So these all are a process. Can I do it in one day and then expect results? No way. Clear? So I need to put up a process which is designed, implemented, maintained. DIM. Designed, implemented, maintained. By whom? Now don't change the order of it. You can't maintain first and then design it. You'll have to design first, then implement it, then maintain it. By whom? TCWG, management or other personnel. Why? To achieve my objectives. What is my objectives? First one, reliability of financial reporting. Don't I want my users to trust my financial statements? Yes. For that, I need to put proper systems in place. Don't I want my business, that is my operation, to flourish? Yes. Efficiency means what? Effectiveness and efficiency is what they have told. What do you mean by efficiency? Achieving the objective by consuming lesser time is what we call as efficiency. Effective means what? The methodology that you adopt should be effective. For example, if it is not effective, it won't be efficient. Example, now revision. You do revision. How are you doing revision? Imagine day 1, you do revision of day 1. Day 2, you do revision of day 1 and you do revision of day 2. Imagine day 25. Revision of 24 days and then you study with respect to 25th day. Time consumed will be more. Efficiency will reduce. So if your methodology is ineffective, the outcome also will be inefficient. You consume more time. Clear? The vice versa. If it is inefficient, that means the methodology is ineffective. So generally operation should have both effectiveness also, efficiency also. Then safeguarding of assets. Now assets can be any type of assets. Intangible asset, tangible asset, clear. Fictitious asset. Fictitious asset is there, no? Loose to fictitious asset is not there. Clear? What is fictitious asset? Asset which you can't see, that is intangible. Fictitious means what? Imaginary asset. How can imaginary asset generate revenue for you? Clear? There is something called as fictitious asset, right? So when we talk about asset here, entities asset we are talking about, not just financial statements related assets. Data also is an asset only. Clear? Server room also is an asset only. Clear? Employees are also assets only. Clear? Then compliance with applicable laws and regulations. So we need to put a system so that we are always ahead of compliance, because non-compliance will attract penalty, and penalty attracts a lot of negative impression from users and also a lot of attention from regulators. So we should always comply with the law and regulation. But if I don't put up the process right, then the non-compliance can happen easily. Like classic example is system update. Who should update the system? Only responsible person should update the system. Now that updation should happen only from management's process. For example, if I am supposed to teach you audit, imagine I come and teach old syllabus here. Now that means I am teaching an outdated syllabus. right? Now I need to put up a process. If there is a new syllabus, where all I should make changes. Clear? So keeping that in mind, I should keep things in mind saying, okay, if I have to make a change, I should have compliance also in place. RBI changed, no, repo rate they changed. Clear? Small company turnover and paid up capital limits they changed. Right? Tomorrow MCA will come with multiple changes. NFRA comes with changes. Right? SEBI comes with changes. My system also should change. Accordingly, my employees must change. Imagine from AS, they are told we have to follow Ind AS. It's a big change for us. Do I need an accountant who has AS knowledge or do I need an accountant who has Ind AS knowledge? I need an accountant who has Ind AS. Therefore, my process should appoint only those type of employees. Clear? So, current employees who know AS, either I should train them for Ind AS or I should fire them and appoint new person. That is a good process. Clear? Next, we talk about audit risk. What do you mean by audit risk? It means you giving inappropriate opinion when financial statements are materially misstated. Now, what do you mean by this? You giving unmodified opinion. You giving unmodified opinion when the financial statements are wrong. That type of risk is what we are supposed to avoid. And that risk is what we call as audit risk. So, what is audit risk? Giving inappropriate opinion when financial statements are materially misstated, and that is giving unmodified when FS are absolutely making no sense. Clear? But the other way around is not possible. You can never give unmodified opinion when the financial statements do not have material misstatements at all. That means you are a psycho, because without evidence you can't give any opinion. Management will ask, if my financial statements have no material misstatement, on what basis you went and gave modified opinion? But on the other hand, when financial statements has a material misstatement, you didn't find out that, and you go and give unmodified opinion, management will love you. Clear? You will be appointed forever because you are negligent. Clear? And that negligence only they want. Example, capital expenses charged to revenue. You didn't check it. You went and gave unmodified opinion. 2 crore worth of expenses have been debited to P&L. That means profits are reported 2 crore less. And you didn't check it. Yes, you go and give financial statements are top notch. Very good. Management will like such type of auditors only. Clear? Of course, later on NFRA can take actions on it. Okay. Then comes misstatement. We already covered what is misstatement. It's a difference between what you have done, that is reported, and what is required for you to report. Clear? That's called misstatement. Then error. What is error? Refers to unintentional mistake. It could be due to multiple reasons. We only are bothered about the intention here. If the intention was there, then it is a fraud. If it is unintentional, then it is error. It could be through different reasons, arithmetical omission, etc. Not important from the exam perspective. Concept is what? Error is an unintentional mistake. Then ROMM, risk of material misstatement. First of all, this, you tell me, this is whose responsibility? ROMM? Management responsibility. It is never our responsibility. Clear? It is they who don't understand accounting policy. It is they who misapply accounting principle. It is they who do cash transaction despite telling don't do it. It is they who appoint wrong accountants. It is they who do not know what is capital, what is revenue, what is asset, what is liability. Clear? Recently, one income tax officer considered debit item of P&L as income. Gone. Clear? It is an expense. Clear? Now that is considered as income. Debit side of bank statement is considered as income of the client. And one notice was issued to him. Clear? The client is not understanding anything. Forget client. CA is mind boggled. How withdrawal of a bank statement can be considered as income. Clear? So they do not know certain things, and because of that, you tell me management will sit and break their head on accounting treatment or business. Business. They will only do business. This suspense account debit to suspense account. Clear? Ultimately, who will clear that? We should clear it. Therefore, ROMM is never under our control. It is under management's control. We can only suggest to them, don't do this. Clear? So, what is the ROMM in audit language, sir? The probability of fraud or error in the financial statements there, which is present before we start the audit. Therefore, this is management's role here. If management has the intention or the mindset of not following certain things, we can't do anything. But can we reduce this risk? Yes. How do we reduce this risk? By putting up procedures. And when we put up procedures, the ROMM reduces, right? And that is called as detection risk. That is called as detection risk. When we put better procedure, we find more and more misstatements. Ultimately, ROMM will come down. Because of this, audit risk will come down. Clear? Right. Next, materiality. We have discussed, when misstatement only I discussed, what is materiality? That which influences users' decision. Which decision? Economic decision. Influencing economic decision. What does economic decision mean? Whether I should hold the investment or not, whether I should amalgamate or not, whether I should demerge or not. These big decisions will be taken based on material misstatement. Clear? Performance materiality means what? It means not at a bigger level, at a root level. When we apply importance level is what we call as performance materiality, which in chapter 3 risk assessment we will understand this better. Okay, in short, to tell you, when we decide that this is my materiality limit, that is example 50 lakhs is my materiality limit. Overall means what? Asset misstatement, liability misstatement, income misstatement, expense misstatement, disclosure misstatement, all put together it should not cross 50 lakhs. Imagine keeping that in mind, I start my audit, and while I am starting my audit, I pick up the purchase transaction or sales transaction, and in that purchase only I got around 40 lakh misstatement. Now imagine, purchase only I got 40 lakh. Now I have to do sales, expense, other expense is there, other income is there, asset is there, liability is there. Boss, if I ignore this 40 lakh now, the accumulation of all misstatement will definitely increase 50 lakhs. So what I will do? Individually I will put importance level. So I will tell purchases is more risky. I will keep only 10 lakhs as materiality limit. Anything above 10 lakhs I will check. Anything below 10 lakhs I will ignore. Therefore, it gives me a little buffer between the 50 lakh materiality and my 10 lakh materiality. Because I am keeping other things also in place. Clear? What if tomorrow some other new misstatement comes? That also should not exceed 50 lakhs. Clear? Okay. Then we have different types of engagement standards. On this, one question was asked. Clear? Not technically on this, on the concept of this. Alright. We have two types of engagement called audit and review. Audit gives me high level of assurance. Review gives me moderate level of assurance. Now, audit gives me positive assurance. Review gives me negative assurance. What do you mean negative assurance? Positive assurance means what? We telling financial statements are free from material misstatements. Negative assurance. How can negative be assuring, sir? Here, negative assurance means we go and tell the users that we have done the review and we have not found anything that makes us tell bad things about the company. This wording is what we call as negative assurance. Clear? So, we telling financial statements are good versus we telling we did not find anything bad. That is negative assurance. Clear? Sir, why can't they say directly, sir? That's how the standards are coded. Clear? Review standards, when we give review report, any review report you take and see, they only give negative assurance. They say, we have not found anything to tell you that things are bad. Because review involves only small procedures and not like audit. Audit includes more procedures, review includes less procedures. Understood? Clear? That is called negative assurance, where we say, we have not found anything to tell things are bad. Clear? Now, with respect to other things, we have something called as related services, where we have agreed upon procedures and compilations. What does agreed upon procedures means? Example, reconciliation, GST reconciliation, bank reconciliation. Clear? Compilation means what? Sir, you would have studied consolidation in your group 1. When you have studied consolidation in group 1, generally now you are preparing based on AS, but listed companies prepare based on Ind AS. Now, when Ind AS was given, some people prepare AS, some people prepare Ind AS. Now, bank will say, I don't want your AS financial statements, convert that into Ind AS and give it to me. Management does not know how to convert it. So management will come to CA and tell, can you please help me in compiling, sir? In compilation, I will not give any opinion. No opinion given. I am just helping you collate information. I am just helping you to put information in the right place. I am not even telling whether that is right or wrong. Example, sir. Imagine management gives me information. Management also is sitting with me. Management has given one information called as traveling expenses. I will not check that. Management will say this is travel expense. Oh, this travel expense, put in P&L debit side. I will not check it whether it is correct or wrong. I have no idea about that. So compilation means I just help you to put things in place. Clear? Because you do not know. Similarly, Ind AS to IFRS conversion for foreign companies. Clear? They say Ind AS we don't want, you convert that into IFRS global standards, you convert that and give it to me. Clear? So for those purposes, we can do those services. Clear? In both cases, we never give any assurance. Even agreed upon, we don't give assurance. Compilation also, we don't give any assurance. Got it? Okay, sir. Now, these are the standards that are there. SQC, SCA, SRE, SCA and SRS. SQC means what? Standards on quality control. SA, standards on audit. SRE, standards on review engagement. SAE, standards on assurance engagement. SRS, standards on related services. These can be asked in MCQs with the concept. Okay. Now, what do you mean by financial statements, sir? Generally, whenever I say financial statements, you have one standard answers. P&L, balance sheet, CFS, SOC, notes. That is with respect to companies. For companies, this is financial statement. Clear? But is that the definition of financial statement? The answer is no. Definition of financial statements, SA 200, which is our mother standard of entire audit, tells what? It is a structured representation of historical financial information, including notes. Now, till here, let's try and understand what is structured representation means. P&L, income, expense, balance sheet, asset, capital, liability. Clear? So it's a structured representation. It is not that one asset, one liability, one asset, one liability will be there. Clear? There is a structure for that particular statement. Of what? Historical financial information. Do you ever put budgets in P&L? No. Do you ever put budgets in financial balance sheet? No. Whatever is there, it is a transaction that has happened. Clear? Futuristic information you will never include in financial statements. Of what? Including notes to accounts. Notes, why do we require notes? To give more clarity on the amounts that we have disclosed in the financial statements. Why are we doing this, sir? The intention is to communicate my economic resources. What do you mean by economic resources? Finance related. Clear? Do you ever put in balance sheet P&L how many employees you have? No. Do you ever put in P&L balance sheet what is the number of kilos or units of inventory you have? No. Therefore, we are not talking about those resources. We are not going to tell how is our HR. We are not going to tell how is our information. We are just telling you how is our finances performing with respect to asset, with respect to liability, with respect to money outflow. Okay? Or obligations at a point of time. Whenever economic resources come, we should remember asset. Whenever obligation comes, it is a liability. So basically what they are trying to tell, it is a structured representation of asset and, but we will not call it asset and liability. We call it economic resource and economic obligation. Clear? Yes. Or the changes for the period of the time in accordance with AFRF. Right? The notes also comprise summary of significant accounting policy and other explanatory information. Sir, how do we understand this? Let's talk about alt of NPO, charitable organization, trust and society. Do they prepare P&L? They don't prepare P&L. They prepare income and expense account or expenditure account. Do they prepare balance sheet? Yes. They do prepare balance sheet. Balance sheet is there for them, but they don't have P&L. They have a different statement altogether, and that is nothing but again a structural representation. How much income we have received and how much we have spent. That doesn't mean we have profits. We have either surplus or either we have deficit. That's it. Clear? That is your definition of financial statements generally. Yes.
In projected financial statement, we can include budget.
In projected financial statements, yes, but that is not historical financial information. Projected comes under futuristic information. There you can give budgets, no problem. But budgets are never called as balance sheet, nor budgets are called as P&L. Clear? We call budget only there. So that comes under prospective financial information. Doesn't come under historical. Okay. What is applicable financial reporting framework, sir? Those acts, those law, those standards that is applicable for my entity is what we call as applicable financial reporting framework. For example, you have so many other things in audit. Is it applicable for you? No. For you, what is applicable? Only financial statement audit with respect to chapter 11 or the 11 chapters for your syllabus. That is applicable for you. Nothing more, nothing less. Same logic for a company. If I am a partnership firm or I am a company or I am a proprietorship, for me, different acts and different regulations are applicable. If I am a listed company, SEBI reporting also I should take care. If I am a banking company, RBI reporting also I should take care. If I am an insurance company, IRDA reporting also I should take care. So according to that, I need to see what reporting is applicable for me, and according to that, I need to go and report it. Clear? So applicable financial reporting framework means what is the framework you have adopted for preparation and presentation of financial statement. Therefore, for a company, Schedule 3 is AFRF. For banks, Schedule 3 is not AFRF. Even though banks are a company, bank never prepares based on Schedule 3. In fact, if you go to bank, fixed assets is the last thing they put in asset. Whereas we put fixed asset as first in Schedule 3 and other things. Clear? For them, cash comes first. But for us, cash comes under current assets at the end. For them, there is no current assets and fixed asset as such. Clear? So their format is based on Banking Regulation Act. So for them, that is the applicable financial reporting framework. For electricity companies, they do not follow Schedule 3. They follow Electricity Act 2003. Similarly, insurance follows IRDA's format. So different organizations will have different formats what they have to follow, and that is what we call as a framework that you have adopted for preparation and presentation of financial statements. In other words, set of rules, regulations that are to be followed for preparation and presentation of financial statements. Example, AS, SA, Companies Act, company rules, company regulations, etc. This is your applicable financial reporting framework concept. Now, these are various matters issued by ICA, not important from the exam perspective, just an additional knowledge, because in case-based MCQ sometimes they'll ask you, they'll give you one line. It is not for question, it is to understand the concept. Standards are mandatory to follow. You can't skip it. General clarification are also mandatory, because general clarification is nothing but extension of standards. You don't understand certain things in standard, they clarify through general clarification. So it is nothing but a part of standards. Remember, these two things are mandatory to follow. Rest, everything and anything is optional. Clear? Guidance note, not mandatory. Technical guides, not mandatory. Practice manuals, not mandatory. Studies and other papers, not mandatory. Now, Caro you would have studied. Clear? But Caro is not so small. Caro is very big. Clear? But Caro, if you see very big, if they say you have to give details, in many clauses they have told, give details. How? Format you have given? No. Some clauses have format, some don't have format. Those where formats are not there, how we should give? No one has told us. Clear? They are telling professional judgment. But there is something called as guidance note on Caro issued by ICA only, where they say you may choose this presentation. Now that is called guidance note. You have a better presentation, follow it. You don't know what to do, you may choose this. Is it mandatory to follow? Not a mandatory thing to follow. But two things are very important to follow. One is called standards and one is called general clarifications. Clear? Now these are the main 18 terms in our audit we are going to see every now and then. Let's begin with that knowledge. Chapter number 1, nature, objective and scope of audit. Definition of audit we have already done with an independent examination, and same prayer we have done. Clear? Engagement also we have done. What is engagement? Arrangement to do something, formal agreement between auditor and client. Clear? And this particular your agreement is called as engagement letter. Clear? What is the purpose of having the audit engagement, sir? To enhance the degree of confidence of intended user. Does that mean user don't have confidence? No, they have, but it just improve. First question, which is very important, when I am looking at the financial statements, what are the things I should check? Number 1, the account should be drawn as per books of accounts. What do you mean by that? The accounts means what here? Financial statements, whatever you are prepared, should be as per books. FS should be as per books and not the other way around. If it is other way around, no, fraud. You're preparing books based on financial statement, that is fraud. Entries must have sufficient appropriate evidence. Without evidence, if you are putting any entry, it is bogus entries. Clear? Which means baseless, right? But does all entry have evidence? Can all entry have evidence? Yes or no? Should have evidence. Should have evidence. Sir, if you don't have evidence, create them. You must have evidence. For example, provision. For provision, what is the evidence? Past year data is the evidence. Current year assumption is the evidence. Futuristic assumption is the evidence. Clear? None of the entries should be left out in the process. Meaning, what is mine, I should never leave in the financial statement. But what is not mine, I should not include in the financial statement. That means business expenses should not be going out. Personal expenses should not be coming in. Okay. Information should be clear and unambiguous. What does unambiguous means? Not confusing. So the way you give information, it should be very clear for the users. That's the reason why we have notes to accounts, where we give more and more clarity in notes to accounts. Financial statements amount should be properly classified, described and disclosed. Meaning, capital expenses should be always shown as capital expense. It should not be shown under P&L. It could be a business expense only. It could be a business expense only. That means we are not talking about point number 3. It is a business expense, but I have not classified it properly. I have not described it properly, or neither I have disclosed. Clear? So, contingent liability, it is not accounted, but it should be disclosed in the notes to accounts. Clear? The statement of accounts should present a true and fair view. What is statement of accounts means here? P&L. In simple language, they are talking about P&L. It should give true and fair view of operational results. Remember I told you Lenskart, Byju's, yes, all these operational results should be given properly, and that's why what they do, P&L, they think of increasing the income side. Clear? One of the banks, I will not name it as which bank it is, one of the banks did that. What they did was, whatever borrowings they had taken, they had shown as deposits. Clear? Just to boost up their deposit side of it. And what they did, just before the year end, they sold all their holdings in stock. I think 31st March was the balance sheet date, and just before that, they sold all their stock, which gave them very good profits. And in the month of April, they acquired the stake again. Clear? For example, imagine I have 60% stake. 9% I will sell. I am still having holding only. Clear? But April, what I will do? I will acquire that 9% again. So what will happen? As on 31st, my profits will shoot up and investors will feel good about it. These type of things is what we are not supposed to do. Now, September 25, that is your recent exam. We will be solving a couple of questions with every chapter wherever possible. Clear? Recent exam questions or RTP questions only will be solving it. Right? Now, what is the question here? CA students, Sriranga and Manga were discussing on the assurance. Clear? Which the services provide to the users in form of opinion of financial statements by means of a written report. Such an assurance lends credibility to financial statements. You are required to state some of the aspects examined by the auditor to ensure financial statements are not misleading. Now, if you actually see, even if I don't read till here, no, I don't have any problem, because that is not the case-based question at all. Just because they give 2 names, 3-4 places and all, no, it doesn't mean it's a case-based question. They're directly asking you what are the points. But if they're told analyze, explain, comment, decide, then it is a case-based question where you have to think and give a conclusion. Here, I don't think your thinking was even required. Just put up these points and you'll get those 4 marks. Now, what is my objective? Main objective is to obtain reasonable assurance whether financial statements as a whole are free from material misstatement, whether due to fraud or error. Ultimately, why am I doing this? To give an opinion. Therefore, my second objective is to report on financial statements. Audit is a high level of assurance or low level of assurance? It's a high level of assurance. High level means what? Absolute or reasonable? Reasonable assurance. I can never ever give absolute assurance. Why I can't give absolute assurance, sir? Because of inherent limitations of audit, and straight away will be doing inherent limitations of audit. What is inherent limitations? Number 1, nature of financial reporting. Meaning what? Our financial reporting requires us to give provisions, judgments, assumptions, etc. Can that be accurate? No. Can you predict future? No. If yes, please tell Jan 26 what questions will come. If you knew, you would not be sitting in marathon because you would be seeing only those concepts studying and going. So we do not know with respect to future what can happen. Provision is an assumption, estimate is an assumption, budget is an assumption, contingency also is an assumption. Requirement, AS 29 says, right? AS 5 says. There are so many things where we have to think about certain things where assumptions are involved. So I can't avoid that. It involves judgment by management. I can't say remove all these judgment. If I'm asking them to remove, that means there is no point in provisions or any other estimates because you are not complying with the standards. But there is one question I want to ask, conceptual question. Provision includes assumptions or not?
Yes.
Provisions include assumptions or not? Yes. That means provision will change from entity to entity, organization to organization, except one, banks. In case of banks, provision doesn't involve any assumption. In case of banks, provision is formulated. Who gives you the provision? How much to create? RBI only will tell. If it is substandard, this much you create. Doubtful, this much you create. D1, this much. D2, this much. D3, this much. They are telling, blindly will follow that. Whereas the same provision for a non-banking companies, I'm not talking about non-banking financial companies. I'm not talking about NBFC. Even for NBFC, RBI has given formulas. Whereas for normal organization like ArivuPro, provision has a formula or provision is subjective. Provision is subjective. Clear? Now that again is an AFRF we have to understand. Okay. So it involves management judgment where they have to take subjective decisions where I can't do anything with respect to that. I'll have to do the audit around those limitations. That's why I can't give absolute assurance. I can only give reasonable assurance. Second, nature of audit procedures. Do you do 100% checking everywhere?
No.
Possible? Not possible. Reliance, ITC, SBI, if you start doing 100% audit, very, very difficult to finish off by due dates. Therefore, the audit procedure only is asking me to curb my instincts. Number 1. Number 2, do I have investigative powers? Do I have power to arrest them, search, seize? No. I don't have so many things. So how can you expect absolute assurance from me? You want absolute assurance, give me power. You don't give me power, you can't expect absolute assurance from my side. Clear? And one of the greatest question of this particular topic is this. There are practical and legal limitations of audit, and give examples they had asked. Clear? Now what is practical limitation example? Sir, I cannot do 100% checking. I have to go for sampling. That is my practical limitation. Legal limitation means what? I am not an investigator, so I don't have investigating power. Therefore, I have only audit power where I can maximum I can do is only report. I can't even take action on that. Clear? So I can't give any absolute assurance. There is one more practical limitation wherever there is fraud. Why? Who gives you the information? Management. Therefore, who can curb the information? Management. Who can hide the information? Management. So we'll have to ultimately rely on management's information only. So it may involve sophisticated and carefully organized schemes to conceal it, and that is a practical limitation. Okay. Not an official investigation, which is a legal limitation for us. Okay. I don't have specific legal powers. Timeliness of financial reporting and decrease in relevance of information. I need to do appropriate planning. Why? The information loses its relevance as and when the time passes. and I have very limited time to finish my audit. Therefore, I have to do an appropriate planning. Now you tell me whether or not you do proper planning for your road trip. Will you at the end of the day reach the destination on the dedicated time or on the decided time? Will you reach there always? No, there will be uncertainties. Clear? So in those aspects, no matter how good your plan is, you will not be able to detect all the fraud or misstatement. That's a limitation. We cannot do anything. If we have to do proofread and foolproof planning, we need that much time. You give me 1 year for 1 year. For 1 year books of accounts, you give me 1 year time to do audit, I will do it. But is it possible? Not possible. You want quarterly report. You want quarterly review report. You want half yearly report. You want annual report. Who are we? And in given time, we have to check everything, prepare the report, review it, and then give the report. If something happens, we will go for massage. And that is okay. There is a reason, there is a limitation. We cannot do anything more. We are giving max to max is reasonable assurance. Clear? Future events. We cannot predict the future. Tomorrow government changes, policy changes. New competition comes and we are thrown out. Can't do anything. Future is totally uncertain. That's the reason why audit is with respect to historical financial information and not futuristic financial information. Clear? The future events may affect, adverse events may seriously affect the business continuance. Is audit mandatory or voluntary, sir? It is mandatory also, voluntary also. Mandatory depending upon your act, clear? Voluntary otherwise also, right? Now here I can ask one good question. I will ask point number 4 as a question, but the answer is not of this, clear? Many entities get their accounts audited voluntarily because of benefits from the process of audit. What are the benefits? Advantages you are supposed to write. If it is mandatory, forget about advantages for me. But if it is voluntarily, why am I doing? Because of some advantages. What advantages? It acts as a moral check on employees, helps in settling liability in case of taxation, helps in settling trade dispute when it comes to wages, bonus, labor acts. Clear? Settlement of accounts in case of partnership. In case of standard costing, you have something called as variance analysis, which will tell me how do I detect wastages and losses. Then, checking whether proper books and related records have been kept so that all the deficiencies or inadequacies are filled in. Reviews the existence and operation of various controls. Government will give you license based on audited financial statements only, and financial interest of people who are not involved in management. We basically call these as stakeholders. Clear? Stakeholders, even they will get a little more confidence on it. So these, if I have to ask you advantages, I can ask you a toughest question of advantages, mixing that point number 4, and answer is this. And generally, you will not even figure out that it is an advantages question. Clear? Technically, I can make it even more difficult by giving that question, and at the end I'll say explain. At least if I ask you what are the advantages, you'll understand that. But if I say explain, no. Gone. Clear? So try to remember the question, what they're asking. The requirement is very, very important. Clear? Right, sir. Now, scope and aspects to be covered. What is the scope of audit? Should I cover all aspects? No. All aspects relevant to the financial statement. So, irrelevant aspects I should not cover in my audit. Number 1. Number 2. I should also check reliability and sufficiency of accounting records and other source data. What do you mean by other source data? Other than books of accounts. Other than books of accounts. Contracts, agreements, invoices, government license, government certificate details, all these contracts, all these come under other source data. You have to evaluate whether information is reliable and sufficient. How? By studying their systems. What type of systems? Accounting systems and internal control system. Because some of them will account once in a week, some will account once in a month, some will account once in a year, some don't only. Clear? So in those cases, our work will be even more. So check their accounting systems. Number 1, in case of some of the organizations, cash. Today, whatever cash has been collected, tomorrow 10 o'clock they go and deposit. Clear? Some organizations will never do anything. Once in a week only they'll go and deposit the cash. Some don't accept cash. Some accept only cash. Right? So this is what we call as studying and evaluating the systems. According to that, my procedure will change. Then carry out such other tests, enquiries and other verification procedure. Determine whether information is properly disclosed. Sir, meaning what? All disclosure should be made. This will promote true and fair view. Clear? So all relevant information should be disclosed. How do I know? Because who is preparing the FS? Theoretically. Clear? Theoretically, who will prepare the books of accounts? Management. Practically, CA only will do it. Clear? He will only prepare the books. He will only do the audit because he knows what type of quality books of accounts management will maintain. So, but as per standard, management is responsible for preparation of information, selection and application of accounting policy, financial statement prepared on historical information. You can never include future information here. Number one. Clear? Now, how do I verify whether they have disclosed proper information or not? They should disclose correct, but how do I verify? Compare the financial statement with the records. For what? Accuracy purposes, number one. Number two, evaluate their judgment whether it is proper or not in preparing FS, including accounting policy, information classification and disclosure adequacy. Tell me one thing. Depreciation method, accounting policy, accounting estimate. Selection of depreciation method, accounting estimate, accounting policy. Accounting estimate, accounting policy. It's an accounting policy. Clear? Changes in depreciation method is accounting estimate. Selection of inventory valuation method, accounting policy or accounting estimate, accounting policy. Now imagine they have chosen LIFO. Is LIFO a right method to choose?
Subjective.
Now we have three things. FIFO, LIFO, weighted average as per AS2. Is LIFO allowed? Where? As per AS2, it is not allowed. Clear? FIFO is allowed. Weighted average is accepted. LIFO is not accepted. Although it is a methodology given under AS2, it is not accepted in the market. Makes sense. Tell me, if what is LIFO? Last in, first out. That means whatever I had purchased before, will that ever be sold? How does it make sense then? So imagine in the month of April I purchased 10,000 units. In the month of May I purchased 10,000 units. Which one should I sell first? As per FIFO, April. As per LIFO, May. How does it make sense? As an organization, as a customer, you will like it. As an organization, what about my April month units then? It will expire. What about my money? Whatever I have invested in the inventory is gone. Loss. At the end of the day, I should sell it at a very less price. Therefore, LIFO is not considered appropriate, although it is there in accounting standard 2. Understood or not? Clear or not? So, selection whether it is correct or not, it is their judgment. Right? Second example, if you are dealing in a business of petroleum products, right? Petrol, diesel and gas and other things. Now, what type of, you have a petrol bunk. Okay, you have a petrol pump. Now you tell me the inventory that you have there, how do I value that? Should I go for FIFO or should I go for a weighted average? I can still go for FIFO. That's the logic I am telling you. I can still go for FIFO. I can still go for weighted average. Depends upon how am I doing my business. What if I am actually packing 1 liter petrol and then whenever a vehicle comes, I pour from that 1 liter. Now it is not allowed. But it was allowed before. I don't know if you are aware. Before, petrol pumps used to have packaged bottles for petrols, cans, 5 liter cans, 10 liter cans. It was there. Clear? So they will, lazy people, clear? Petrol is there in the tank, fill and keep in the bottle, finish it off. Clear? So if I am doing business in that way, then FIFO makes more sense for me. But in case of ease of doing business, I have a tank. I keep on refilling it. That means old stock is mixed with new stock. I can't really have a FIFO logic there. Therefore, I should use weighted average. Clear? If I am having a water business, drinking water business, should I follow FIFO or weighted average? Again, depends. If I am having a packaged drinking water, then it becomes FIFO is more reasonable. Otherwise, weighted average becomes more reasonable. So that is the logic I should see. And that when I evaluate their system only, I will get to know. Do not perform any work which falls outside your scope. Example, investigation. Don't do it. Clear? If they ask you to do investigation, don't do it. It falls outside your scope. Clear? Can I ask personal questions to directors? No, falls outside your scope of business. Then, you are not an expert in authentication of documentation, meaning what? Sir, whether a document is fake or original, it's not my job. My job is to go and do the audit. You give me investigative powers, I will do it. Clear? So I am not an expert. This is one of the very good question I can ask in the exam. I am not an expert in authenticity of documents. My question to you, I am not an expert, correct. If management gives me fake document, who will be liable? Management will be liable. I am not liable because I am not an expert. You can't make me liable. But if I find suspicious invoices or if I find a little doubt in that particular document that you have given, I need to apply professional skepticism there. Clear? Okay. It is not an official investigation, therefore I don't have specific legal powers. Any constraints if they put, you need to express qualified opinion, meaning what? What is my default opinion? Unmodified, or we also call it as unqualified opinion. Anything that is stopping me from giving unmodified opinion, there I should give qualified disclaimer or adverse. So basically, I have to give modified opinion if you stop me from giving unmodified opinion. You're not letting me work properly, therefore, modified opinion I will give. Clear? Okay. What are the areas I should cover in audit? Accounting system and ICS have to cover. Clear? Any other system and procedures which is relevant to financial statements. Checking arithmetical accuracy. What does arithmetical accuracy means? Calculations of interest, PF, ESI, depreciation, etc. Authenticity and validity of transaction. Whether the transaction actually has happened or it is a fake transaction. Okay. We do pass book entries in the books of accounts. Mind you. What are the book entries we pass? Depreciation is a book entry. Clear? Provision is a book entry unless you are creating a separate fund. Book entry means only in the books of accounts we are passing the entry. In reality, we are not having any such transaction. Clear? Closing adjustment, these are all book entries only. Proper distinction between capital and revenue nature. Comparing the balance sheet and P&L with books of account, it should be properly dealt with. Which should come first? Books should come first or financial statement should come first? Books first and then financials. Verification of title, existence and value of asset appearing in the balance sheet. Meaning my asset only should come in balance sheet. Example, sir. There are two assets. One is owned, one is leased. In the balance sheet, both will come. But under the appropriate heading. Leased assets will never come under my fixed assets. So there separately I will give called leased assets. So that proper title, is it given or not? Verification of liability, whether proper liabilities have been known liabilities should be there in the balance sheet. Checking the results given by P&L, whether they are true and fair. And in case of a company or LLP, then you have to comply with statutory requirements, that is Companies Act or LLP Act. Then reporting to appropriate person, whoever appointed you, you're supposed to report it to them. Okay. Now, who appoints the auditor, sir? Very simple. Thumb rule for this. The one who owns will appoint the auditors. Example, government company, who owns? Government. Therefore, who appoints? Government. Through whom? CAG. Non-government, who is the owner? Shareholders. Therefore, who appoints? Shareholders. Clear? If it is the first auditor, then board of directors. Subsequent auditors, then shareholders. Clear? If it is a partnership firm, who is the owner? Partners. Proprietorship, who is the owner? Proprietor. Therefore, they will appoint. Clear? That is your appointment of auditors. Who should I submit the report to? Same thumb rule. Whoever appointed us only, we are going to report it to them. And this is what we call as addressee in your SA 700. SA 700 second element after title is nothing but addressee. The one who appoints us, we are going to submit the report to him. Assurance engagement, we are done with. Elements of assurance engagement. There are 5 elements. It's a 3-party relationship. How many people are there here? 3 people. Who are those? Practitioners are there. That is CA. Responsible parties are, which is management. Intended users. In my stock audit example, it was bank. Clear? So what I will do? Audit is with respect to historical information. Responsible party is the management, the one who is preparing the information. Users are the one who is using this particular report. Then appropriate subject matter. In my example, what was subject matter? Inventory or stock was a subject matter. Then suitable criteria. This criteria will be fixed either by standards, guidance, laws, rules and regulations. In my example, bank told me the criteria. So they will tell according to RBI and Banking Regulation Act only. So criteria is always fixed by the law regulation. We require evidence to give our opinion on even assurance engagement. Clear? Sufficient with it talks about what? Quantity, sufficiency, and appropriateness talks about quality of evidence. Clear? Written assurance report should be given always and always. We always give report in the form of writing and never in the form of oral. Clear? 5 elements are there. Then, meaning of audit and review. Difference is important. This was asked once in the exam as a case-based question. Okay. After this, we have prospective financial information. Sir, which gives better assurance when it comes to audit and review? Audit. Review gives lesser assurance. Audit gives higher assurance. Which has more procedures? Audit has more procedures. Clear? Now, as a organization, which one do you trust more? Audit or review? Audit. But do we have, every time do we have enough time to audit? No. Therefore, we have a concept called as limited review concept in case of listed company as well as in case of unlisted company. So we can do a review and give as well. So audit is a reasonable assurance engagement. Review is a limited assurance engagement. Review involves lesser procedures. Audit involves more procedures. But both are with respect to financial statement. This is an important concept. Both are with respect to historical financial information. Review also goes to HFI. Audit also goes to HFI. Okay. Now, besides the reasonable assurance engagement and limited assurance engagement, there is another kind called prospective financial information, which is based on assumptions about events that may occur in the future and possible actions by the entity. These are the keywords in the question you have to see. These are the keywords, assumptions about events that may occur in future. Example, forecast, budgets, projected financial statements. Projected financial statements are in trend everywhere now because you want loan. You want a loan, bankers will say, give me next 3 years financials. Now, next 3 years financials, how do we prepare? Based on assumptions. So, how do we assume things? Randomly we assume? No. Do we go to sleep? One dream will come, that assumption will take next day. No, sir. Based on your historical data, yes, based on past data and based on your future, what? Data, wa? No, sir. Sir, past data will have, that is base for us. Then we will ask management, how are you looking yourself into future? Clear? So they will tell, sir, next year we are thinking about 5% growth. Now that growth we compare with industry average. Or we compare in that industry whether the growth is average, what is 5% or 10%, accordingly we will take. For example, imagine in that industry average is 10% and you are expecting growth of 50%. Reasonable or unreasonable? Unreasonable. So we should not take whatever management asks us to take. We have to do a little bit of study on our own. Clear? Classic example, in your financial management, capital budgeting, you would have solved concepts. Clear? Capital budgeting is there, no? In FM. Not there. Not there. Really? Investment decisions. NPV calculation. In NPV calculation, you have cash flow. Yes. Cash flow is nothing but future cash flow is there. You bring it to present value. There is PV factor. Who told you that PV factor? Question tells, sir. Question will give us PV factor. In reality, question will not give you PV factor. You have to assume that PV factor. Clear? That assumption should be reasonable. Clear? Now imagine you consider PV factor as 1%. That means imagine your NPV. It will shoot up like anything. Yes or no? So we need to understand whatever PV factor you are taking, is it reasonable or not? Clear? So comparing, now these all are assumptions. Your future cash flow is an assumption. Clear? Goodwill, number of years of purchase. Factor, yes, super profit method. Super profit is your historical data. Number of years of purchase is futuristic data. You are assuming that the super profit will continue for the next X number of years. Now, on what basis you have taken this assumption? That assumption should be reasonable. Imagine selling company says, I will sell you my goodwill, but super profit into 25 years of purchase. Now they'll tell, hey, mad fellow, 25 years you'll think that this only will continue. Yes, but don't you think the purchasing company also will have an argument? Boss, I am purchasing your company. That means who will run? I will run. So according to me, for the next 3 years is what the super profit will continue. After that, I will have super duper profit because it is my company now, and my traditional methods I will evaluate and my methods I will put. Therefore, your super profit may not be earned in the next 3 years, but I am ready to give you that goodwill today itself. Now, this is assumption. Clear? In costing, you have budgetary control. Everything is assumption there. Yes or no? You prepare budgets, right? That budgets is what? Based on what? Based on question given in the costing. Who gives the data? Management. And that is also an assumption. Going concern, assumption. Whether you will live or not, it's an assumption. Clear? I'm talking about companies, right? Now, which means whether I will continue my business or not is nothing but what? Is an assumption. Now, in Tamil Nadu, let's imagine going concern is there or not, I will tell. Now, next year election is there. Yes, government may change, may not change. If government changes, policy changes. Because of that policy, company can shut down. It's again an assumption. So, you take prospective information, but it is totally based on what? Assumptions about event that may occur in future, and if it occurs, what is our possible action? It can be in the form of forecast, projection, or combination. Now, this point is important. In assurance report involving PFI, what should I include, sir? The practitioner obtains evidence that management assumptions are not unreasonable and all material assumptions are adequately disclosed. Whenever you are giving a report on PFI, you should disclose the assumptions. Clear? You should always disclose the assumptions. What all assumptions we have taken, we have to put it in the report and then give. There is one more thing which we have to clearly tell that prospective assurance engagement, I should provide a report assuring nothing has come to my attention to suggest that assumptions taken do not provide a reasonable basis. This is what we call as negative assurance. This is what we call as negative assurance, where we clearly go and tell them that I have not found anything to tell that assumptions taken do not provide reasonable basis. Clear? This is called negative assurance. You see here, you will not get any negative feeling. But the way I have given audit assurance and this assurance is totally different. In audit, I say what? Reasonable assurance that financial statements are free from material misstatement. Here what I am telling, I have not found anything. Clear? That suggests me that assumptions do not provide reasonable basis for projection. Who takes this assumption? Management takes this assumption. Okay? While evidence may be available to support the assumptions, it is generally future oriented. Here also evidence will be there, but the evidence is future oriented and not historical information. Yes, the basis could be historical information, but technically it is future oriented. Therefore, we are not in a position to express an opinion with respect to the results shown in the prospective information. It provides only a moderate level. Therefore, now we have 3 levels of assurance: audit, review, and prospective. That is forecast. If I see the hierarchy, which tops the list? Audit. Then comes review. Then comes PFI. Got it? Understood? Yes, in the exam MCQ, be careful. Case-based MCQ they will give you. You should not get distracted by the names given. It can be your crush's name also. Don't get distracted. Think. Clear? Audit stands at top. Review comes next. PFI comes at the end. Okay? Now, qualities of auditor, exam-wise, not at all important. What are the qualities of auditor? You should have patience, you should have knowledge, you should have clarity, all these things, okay, which no one has. Knowledge has, yes, knowledge everyone will have. Clear? Patience, I doubt. Okay, but they say you should have good temper, meaning keep getting angry. No, good temper means have good temperament. When a client comes, client for us is an not knowledgeable person. Clear? He will not know anything. Clear? I had a client who asked me, my business, my money, I have no problem paying cash. The opposite person has no problem accepting cash. Who the hell are you telling me not to pay in cash? Now I can't get angry on him. Clear? And I told boss, it is government's rule. And he questioned me next, who the hell is government to tell me? It's my business. I'm like, I can't do anything. You have to follow that. Clear? So such clients will be there. I have clients who have no education but have very good business. Clear? The one who's selling tender coconut also is my client. Clear? But at a bigger level. He does exports of tender coconuts. Clear? He has foreign exchange, but he doesn't have knowledge about accounts and audit. Now I need to make him sit and understand what is books of accounts. Clear? Now he will tell, yes sir, I have books. Normal, I have one diary that in that I will write. Actually, he has done that. Now I need to educate him as to this is correct. When the business is small, this is good. But when you're moving towards tax audit, right? He's crossed like 3 crore, 4 crore, 5 crore in a year. Okay? Yearly turnover. Now I need to educate him how you have to maintain books of accounts. Clear? He doesn't know. He knows only one software to operate. That is billing software and UPI. Clear? So how do we inculcate the books of accounts? That's why they have a good temper with respect to the client. Have caution, firmness, integrity. What is integrity? Honesty. Tell honestly if it is happening or not happening. Clear? Discretion meaning judgment. Your discretion means you should take your own call. Industry judgment. Patience, clear-headedness, reliability should be there. More than that, forget that. You should have this. That is very important. Imagine you have everything, but you are not independent. People will not trust you. Clear? You should have independence. That too at highest degree of integrity backed by independence. Clear? You are in a position of trust. Therefore, basic human qualities nonsense. Clear? Next, exhaustive knowledge of accounting you should have. What is exhaustive knowledge of accounting means? Everything. Whether you have it or not, that is secondary. But you should have it is what they expect you to do it. Clear? Then we have dealt with these standards which comes under MCQ language for you guys. Okay? SA, SRE, SAE, SRS and SQC. More important is why do we have this standard? What is the purpose? This has been asked in MCQ in September 24 and in May 25 they have asked for 5 marks. Bumper question this is. Clear? Why do we require standard? Obviously, it is an established benchmark at par with global practice. Here they will test you by giving local practice. It is not local practice, it is global practice. We have to be in line with standards which is at international level. Our SA are in line with ISA, International Standards on Auditing. Clear? And the accuracy is almost 90%. 90 to 95% match will be there with ISA with some tweaks here and there. Clear? Because there are certain things which they follow which we do not follow. Clear? Why do we have standards? To improve quality of financial reporting, thereby users can make better decisions. Then to promote uniformity as an audit of financial statements. What do you mean promote uniformity? Sir, 1,000 companies are there, 1,000 audit reports. In 1,000 ways I should give No, one way. That is why SA 700 everyone should follow. Clear? Same format. Okay. Then standards equip professional accountants with professional knowledge and skill. Now, whatever audit you have studied in your college under direct entry scheme, if you have studied audit and that audit and this audit, is there a difference?
Yes, sir.
Is there a difference? Definitely yes. There is a huge difference because here you are a professional accountant. You should know professional knowledge and you should have professional skills to do it. Standard ensures audit quality. If you open NFRA's website, in a month at least 1 or 2 cases you will see. Because they are so strict when it comes to quality management. You should have that particular quality in your audit. They will not be compromising on audit or rather quality. Clear? What was the question asked? They said mention any 3 standards. Very good. Out of these 5, any 3 you have to mention and then mention the purpose. So this entire thing that asked for 5 marks. Next, duty. What duty do I have, sir? Generally 3 duties I have. Number 1, what is my accountant's duty? Ensuring that standards are followed. Number 2, sir, can I depart from the standard? Yes. But, why? To attain quality. not to break the law. I am breaking the law here, I am breaking the standard here because I want to achieve a better quality. For that, government says or a regulator says, okay, you can do it, but there is one condition if you do it, you have to document what you have done. Clear? So if you deviate, you can deviate, but you should document the alternative procedures as well as the reasons for it. Reporting requirements. Highlight any departures from standards. Sir, I can depart. No, so can I do whatever I want? No. You can't do whatever you want. You have to follow the standards. But in situations where it is not giving you results, only then you depart from the standards or law. That is okay for me. But you can't keep that only as a reason and keep departing every now and then. For example, let's say you have live online or recorded facility given by the academy. That doesn't give you the liberty to keep skipping classes. That is only for what? Emergency purposes you can go and watch. Clear? That is the logic. You can depart, but in not all circumstances. If you are departing, you have to document first. Clear? And you should comply first. Only after compliance, if you feel it is not giving me the quality, then depart. Don't directly depart first. Okay? Then, let's talk about few questions of this particular chapter. Now, if you see such a big question they are given. Alright? Now, directly if you go to the requirement, half the problem is solved. Right? What is the direct requirement if you see? Objectives of an independent audit. What is my objective of audit? Two things. Reasonable assurance and reporting. But for that entire story they have given. Clear? This is the technique how you should apply in reading the question paper in 15 minutes. Just keep reading the requirements and keep moving forward. Don't sit and read the case because anyway you will have to read that. Okay. So here you will be writing rare. Rare means what? Reasonable assurance and reporting. Two main objectives. Then stand essay applying historical information. SRE applies in review of historical information, explaining detail, giving examples. This is audit versus review. Which has more procedures? Audit. Which has less procedures? Review. Which has high assurance? Audit. Clear? Now in this case, no, that table what is there in this particular material, you can write that. Reasonable assurance and limited assurance. Next. Here, Kirti or Kriti, a CA student, directly go to the requirement. What is the requirement? Whose view appears to be correct, state with reasons. Now, this is a good case based because they have not given specific requirement. They said whose view is better. Kriti, a CA student, joined articles in a reputed firm. She considers engagement to be an assurance engagement. Her understanding is that audit engagement is the only kind of assurance engagement in which practitioner gives a written assurance report. However, her friend Somaya does not agree with her. She is of the view that assurance engagement are not restricted to audit alone. Besides, she also thinks that assurance engagement can relate to matters other than historical financial information. Yes, no. Review is there. PFI is there. Clear? So she says only audit. One more person is saying, no, there is other, apart from audit also, there is assurance. What is that? Review also is there. PFI also is there. About that, you'll have to write. And conclusion, Somaya is correct and Kriti is wrong. Okay. Then, this also is a very good question. See, September is a mix of questions. So, September attempt also has good questions. PD and Co. CA were appointed as chart auditors for financial statements of financial year 23-24. Mr. Limited is appointed as auditors. Now, what they should do? Their letter of engagement says the auditor shall be responsible for detecting the fraud that may happen in the company during the financial year 23-24. They audit our objective to inclusion of such a clause. Meaning what? Sir, they have included a particular clause in our engagement saying we are responsible for detection of the fraud. Are we? Are we investigators? No. What is our primary responsibility then? Obtaining reasonable assurance. While we do the audit, if we find any fraud, then we need to report that or perform procedures on that. So our primary responsibility is not to detect fraud. Therefore, this clause is not required and this has to be removed. But if you sign this, then you are in trouble. Clear? So before signing, that's the reason why we read our engagement letter. But again, this makes no sense for one reason. Question wise good, but practically all the engagement letter is sent by me to them. It is sent by auditor to client. But here they have told in the appointment letter to the auditors, they have put this clause. Now, obviously, when I am preparing, why will I put this clause? Clear? But again, coming to the question they have given this way, keeping question in the mind, will be writing the answer. Okay. Then RTP Jan 25, again a big question they have given. I will be focusing only on the requirement. What is the requirement? Required to state the objectives of an audit. What is objective again? Rare, reasonable assurance and reporting requirement. Explain why he can provide only reasonable assurance rather than absolute assurance. What answer you will write here? Limitations. Limitations you are supposed to write. Next question number 6, which is for Jan 25. What they have given? Explain the difference between prospective information and historical information. Therefore, audit review versus forecast budget. Okay. Audit review versus forecast budget. Next, benefits and need of an audit. Straight away they're asking what? Advantages of audit. Clear? That is moral check, helping in settling liabilities, taxes, all those things. 8th one, good question, May 25 RTP question. XYZ Limited, a manufacturing company based in India, operates multiple plants across the country and deals in complex machinery, which requires specialized maintenance and valuation expertise. XYZ Limited appointed CA Dhruv as statutory. During the audit, he observed that management consistently applied the same method for valuation of inventory over the past few years, but this year, without proper disclosure, they switched to a different valuation method, which resulted in higher reported profit. Does such a matter fall within the scope of audit? Matter, they are asking about scope. Clear? They are asking with respect to what? Scope. Now, does it come within the scope? Of course, yes. Can you change accounting policy? Yes. But should you disclose? Yes, because as per AS1, you can change your accounting policy if it results in better presentation or requirement of law. But you have to disclose the changes in accounting policy. It falls within the scope of the audit. Therefore, he is right. Yes, it falls below the scope of audit. Next, Mini and Associates CA were appointed as the auditor of Sin Limited, a construction company. During the audit, CA Mini, partner of the firm, noticed the following. Company has several ongoing projects, but only select projects revenues have been reported. Several expense vouchers are either missing or are handwritten and lack proper authorization. The company has changed its depreciation method from straight line method to WDV without adequate disclosure. These matters were brought to the attention of the management, but management argued that auditor scope of responsibility, it falls outside the scope. Is it true? No, absolutely not. It is within my scope only. In scope of audit, they have clearly given you have to have your financial statements as per books of accounts, proper accounting policies should be followed, should be disclosed, judgment should be disclosed, policy should be disclosed, covering all adequate aspects of financial statements. So basically here also you will be writing scope of audit. Clear? So they are giving more importance to scope of audit and types of audit in this chapter. Clear? So in this chapter, chapter number 1, be prepared for areas like scope of audit. Clear? Scope, if you do, aspects will come along with it. Clear or not? Then you have types of assurance, limited, moderate and reasonable. Clear? So these 3 areas are very good areas where they can test you with respect to questions. Then comes objectives of audit. Clear? These 4 areas, in the recent times, if you have seen the trend, they are circling around these 4 areas. Then suddenly one more area, surprise area, is assurance engagement. Your elements of assurance engagement, 5 elements are there: 3 people, practitioner, responsible party. Those areas are important. So 5 areas, be little careful. These are red light areas where it is very, very important. High alert areas these are. Okay. That is your chapter number 1 with respect to nature, scope and objective. Next, we will move on to chapter number 11. Now, chapter number 11 talks about ethics and terms of engagement. Two things we have to discuss here. One is your ethics and one is your terms of engagement. Standards we are going to cover in this chapter is SA 210, then we'll cover 220, and then we'll cover SQC 1. So there are three standards we are going to cover here: 210, 220, and SQC 1. SQC 1 and 220 is one and the same, but at a different levels we are going to apply it. Now, do we require ethics in life? Forget about personal life. Professional life, do we require ethics? Yes. Why? Because we are representing public here and we are instilling public's confidence every now and then. So we have public interest responsibilities. We are expected to act in the public interest, number one. Number two, professional ethics importance. Professional ethics protect the profession's interest and ensure respect. You told no, you are doing this course for status, respect and other things. Definitely yes, it gives us more respect. Ethical compliance consequences. Deviating from the responsibilities can lead to disciplinary actions including fines, suspensions, removal from membership. NFRA, Companies Act, ICA, everyone will come together and give you very good time in your life if you do something wrong. Clear? What are the fundamental principles? Very important. Fundamental principles are 5. Remember one difference in the question or in the exam, if they are asking fundamental principles, then you have to write 5 things: integrity, objectivity, professional competence, professional behavior, right, and confidentiality. These are the 5 fundamental principles. But if they ask fundamental requirements, then you have to write 6. Clear? 5 fundamental principles plus independence, right? If they be very careful, if they are asking principles only, right, 5. If they are asking requirements, then additional point also will come called independence. Okay? Because if you have seen in chapter 1, high degree of integrity backed by independence they have told. So independence is a requirement. Clear? It need not be a fundamental principle here. Okay. Now what is the first principle? Integrity. Now on individually they can ask you questions here. So be a little careful. Here when I talk about integrity, we are talking about straightforward and honesty. Where? In which relationship? Professional and business relationship, right? Now in personal, whatever you want you do, but in professional life you should always be straightforward and honest. Number 1. Number 2, integrity means fair dealing and truthfulness. Now for integrity purposes, the key phrase in the exam to understand, for 2 marks they'll ask this. Clear? Now in chapter number 11, there are 2 areas where from the last 2 out of 3 attempts, Jan, May, September. In these 3 attempts, in the last 2 attempts, that is September and Jan, they have focused on threats of independence and such type of questions, fundamental principles. Clear? So they want to test you whether you are aware about the fundamentals or not. When I talk about integrity, you shall not knowingly be associated. What is associated means? Connected with information where accountant believes that information contains materially false or wrong statement. Clear? Contains statement or information provided negligently or omits or obscures information which would be misleading. Now, how do I understand whether they are asking about integrity or not? Remember, integrity when it comes to, we are talking about information, reports, returns, communication, etc. Documents basically. Clear? Whereas, if you go little bit here, if you see professional behavior also very similar. You should not engage in employment, occupation or activity. So, in the question, if they're asking about association with employment, professional behavior comes into the picture. If they're asking with respect to association with documents, integrity should come into the picture. Clear? So, remember that way. Clear? I for integrity, I for information. If you are associated with wrong information, false information and all, then integrity is not there for you. Professional behavior comes in the case of occupation. B for behavior, B for business. Okay. Next is objectivity. What is objectivity? Not to compromise your professional judgment because of bias. Example, you taking up your father's business as audit. It is not good because you won't be objective there. You will be biased. Next. It requires the accountant shall not undertake a professional activity if the circumstance or relationship influences accountant's professional judgment. So basically avoid if you have any bias or conflict of interest, or solve that bias or conflict of interest and then go for audit. Professional competence and due care means what? You must first obtain professional knowledge and then you have to maintain professional knowledge. Why? Sir, I am a CA, but if I am not an updated CA, then my clients will get outdated services. Therefore, they will suffer because of me, and you should always maintain this professional knowledge and skill to provide the organization competent services based on current standards and legislation. Therefore, I can avoid outdated service. And for this you will have to attend seminars, conferences, research papers you have to read, amendments you have to read, and then only you can maintain your professional knowledge. Diligence includes responsibility to act carefully, thoroughly on a timely basis. Now here one question they can ask. What is that question? Now, let us say there is a partnership firm, there are 10 partners. One partner's client audit is done, but the signature is pending. He was traveling to the client place, he met with an accident and he passed away. Now, the other partner signed the financial statement. Is the other partner contravening fundamental principles? The answer is yes, because although it was his partner's financial statements only, although it was firm's financial statements only, he signed it without reviewing it, and therefore there is no due diligence. Clear? You should do proper diligence. Due diligence is nothing but do your homework before you sign. Get to know what you are signing. Review it. I'm not saying audit it again, but review and then go for sign. Next is confidentiality. What does confidentiality means? Maintaining the secrecy of the client's information. Confidentiality protects the information shared between accountants and clients, promoting open communication. If I don't tell your matter to anyone, you will come and communicate to me, and that is what we want. Clear? But can I disclose it to others, sir? Yes, provided it is permitted by law, authorized by the client, or there is a professional duty to disclose. What is this professional duty example, sir? Example, section 143, subsection 12, that talks about fraud by or on the company should be reported by the CA. Clear? This puts a duty on me. I need to report it, whether I like it or not. So there are three things I can disclose information through. Number one, law. Number two, client's authorization. And number three, professional duty to respond. Okay. Next, professional behavior. How should I have professional behavior? Compliance with relevant laws and regulation, and avoid any behavior that might discredit the profession. Like for example, you go to parties, you go to public events and all. Don't spoil our institute name there. Like you behave nicely. Don't be like, like Hardik Pandya and KL Rahul in Coffee with Karan, where he mentioned some statement and he was banned. He was removed from the contract. Now that brings disrepute to the profession. Clear? Because tomorrow there, in newspaper and all it came, Indian cricketer made obscene comment. Now you go somewhere to your personal visibility and you make nonsense comment there. But what will people think? You're a cricketer. That means BCCI is tainted. Same thing ICA does. You go, you do anything you want, but don't put dirt on my institute. Now imagine you are drunk in a party and you're creating drama there, and you're like, I am a CA, like this, like that and all. Tomorrow in newspaper, first headline, a chartered accountant is no more a chartered accountant. Not your name didn't come, no. ICA's name came. So they are saying, do not involve in anything knowingly. Knowingly do not involve, that means discredit the profession, or don't bring disrepute to the profession. This word also they can use in the exam. Clear? So, shall not knowingly engage in any employment, occupation or activity which stops you from behaving with integrity, objectivity and reputation of the profession. So, do whatever you want, but ensure that ICA is not in problem. Yes?
It doesn't talk about misrepresentation.
It doesn't talk about what?
Misrepresentation.
Like?
Doing it without knowing it. Like knowingly.
Unknowingly, no problem. Unintentional. See, for example, if a client has given me a glass of something and I don't know what is there in that, I assume certain things and I drank. Later on, whatever consequences happened because of that. Now, I didn't do it knowingly. Unintentionally, no problem. It's because you are a human. A CA is a human. ICA knows that. So unintentionally, you don't do it. Intentionally, if you are doing it now, then you are supposed to, you are liable for consequences. Unintentionally, you do not know at all. You may end up doing it. That misrepresentation allowed. No problem. Client gives me wrong information. I can't do anything without it. Okay. Leadership responsibility, we will not be doing it here. Okay. Because it is with respect to SA 220. When we go there, we will do it. Independence. What do you mean by independence? Giving of opinion without under any influence. We are giving our opinion based on our knowledge and our information, whatever we are giving. Okay. There are two things: independence of mind and independence in appearance. What is independence of mind? State of mind, thought process. Thought process means what? You giving an opinion without being affected by influence. So when management comes and says, sir, give this opinion, hey, poda, I will not give that opinion, I will give my opinion only. So, sir, I will give you 1 crore rupees as bribe. Not enough. Meaning, I will give my opinion. You can't bribe me with 1 crore rupees. Clear? Don't say not enough and take more. You give your own opinion. Understood? Okay. Then, independence in appearance. What is independence in appearance means? I should behave in such a way. See, thought process will be shown to people only when I behave. Right? Now, see, if you like someone, you have to go and tell. If you think it in your head, it's of no use. Clear? So, thought process also must be there. Execution also must be there. Execution means you should not avoid facts and circumstances. If you avoid facts and circumstances, no, third party will always think that you are biased. That bias should not be there. So, whatever information you are getting, take it. Meaning, if two people are coming and telling you, don't listen to one party and give an opinion. Listen to both parties, take judgment of both parties and then give a opinion. Okay. Next, what are the threats to independence? Very important. Every now and then they test here. Clear? Like I said, 2 out of last 3 attempts, they have tested on threats. Clear? And that too what? Classic question. In order only they have asked. Self-interest, self-review, advocacy, intimidation. Like that only they have asked. Clear? Jan 25, one extra question they have given. Self-interest has been repeated twice. Clear? September, 4 marks. Totally, I'll tell you, around 8 to 9 marks only on this they have asked in the last 2 attempts. Last attempt, 2 out of 3 attempts. Clear? Now, what is self-interest threat? Where I will be bothered only about my financial interest. Clear? Like what? Direct financial interest or even indirect financial interest, number 1. Number 2, loan or guarantee. Loan giving to the guarantee to the client, loan taking from the client. Giving guarantee to the client, taking guarantee from the client. Both are financial interest. Undue dependence on client's fees and fear of losing the engagement. Now, if you are dependent on client's fees, he will start demanding what he wants from you. You should not give the opinion he wants. Imagine your entire practice ka revenue is 10 crore. Out of that, 8 crore comes from one client. And he says, if you don't give this opinion, I will withdraw from you. I will see for a new CA. Now, that will drop your revenue to 10 crore to 2 crore. Do you want that to happen? Now, if you say no, then you have to listen to him. Clear? So, you should manage this situation by saying, boss, I am not scared of losing you. If you want to go, you go. This is my ethics. Clear? Theoretically. Next. Close business relationship with an audit client. Now, close business relationship means what? Sir, having relationship with the client is allowed, sir. It is not allowed because it will create familiarity threats now. But if you are having business relationship, it will create self-interest threat. Meaning, imagine you have a practice. On the other hand, you have a business also where this client is a partner of you. Yeah? And in that case, it is a business relationship. If I give wrong opinion here, there it will affect. Therefore, because my business should not be affected, I will give opinion whatever he wants. Wrong opinion you are giving. Potential employment with the client. He is telling you, I'll give you more clients if you sign unmodified opinion now. I'll give you 10 more clients. I'll give you 20 more clients. We don't want such things. Contingent fees for engagement generally happens in loan. Generally happens in loan approvals. They will tell, sir, could you draw balance sheet for the next 5 years and give me? And it should look good, sir. 100 crore loan I am applying for, 2% I'll give it to you. Clear? So 2 crore I will give it to you for that. Now it's a contingent fees for such engagement. If the loan passes, if the loan doesn't pass, no, then you will have a new friendship there. Okay, you will have to go to jail. Clear? It is contingent. If the loan gets approved, okay, such risk and all you should not take. Next is self-review threats. Self-review threats is what, sir? Simple. You are only preparing the question paper, you are only writing the answer, your friend is evaluating it. You will be a rank holder only. Clear? So we don't want such threats. Therefore, you are only preparing the books of account, you are only auditing that. And you are telling financial statements are free from material misstatement. This is nonsense. Clear? So, who should prepare? Management should prepare, we should audit. Now, theoretically again. Practically, we will only prepare books, we will only audit them. Okay? But there is a way to do it which we will not discuss in the class. Okay? Self-review threats means what? Which occurs during a review of any judgment or conclusions reached in a previous audit or non-audit engagement. Example, sir. When a member of the audit team was previously a director or senior employee of the client. Very good. He was with us. Now he is there. Of course, there is a self-review threats. When auditor having recently been a director or senior officer of the company. Ulta. I was a director. Now I am a CA, practicing CA, and that company is my client. Whatever I have done, I am only auditing. Clear? Not allowed. Then, when auditors perform services that are themselves subject matters of audit. Example, books of accounts and audited by us only. Clear? Not allowed. Then, advocacy threats. What does an advocate do? Defend his client. So, whatever it is, we will defend our client. That does not give us integrity at all. Clear? Which occurs to the auditor when you promote or perceive to promote client's opinion where they believe your objectivity is getting compromised. What do you mean by objectivity? What does objectivity means? Not to compromise professional judgment. You should give proper judgment. And if you're taking client side, that means you're giving a biased judgment. That should not happen. When will it happen? When you are only dealing with shares or security of the company. Imagine you have shares or securities of the company. You're gone. Clear? Now, you will take client side because you know my investment is there in the company. If I go against this particular company, my investment value will reduce. I will give good opinion about it only. Now, to avoid this, I know what doubt you might have in your head. If I have a share in the company, how can I become the CEO of that particular company, sir? For that reason only the disqualification came. Clear? For this reason only the disqualification came, where if you have a single share in the company, you or your partner, if you guys have one share also of 1 rupee each, you are disqualified. But your relative can hold up to 1 lakh rupees of face value. In paper number 2, you would have learnt it or you will learn it. Clear? That disqualification came because to avoid this type of independence threat for us. Clear? So if you are dealing with the shares or securities of the company, then it is a advocacy threat. You become the client's litigator in third party litigation. Very good. A CA is also taking up litigation when it comes to third party and management. Now you tell me whose side you will take. Management side only you will take with respect to third party. Not allowed. That means as a chartered accountant, do not involve in litigation or do not take up cases where there is a third party dispute. You just do your CA duty, nothing else. Clear? In such situation, you can be perceived as backing and championing causes of auditee client, therefore taking sides of client. That is what they will assume. Who they? Third party. Familiarity threats. What is familiarity threats? Where you have families involved in that. Families means what? It could be your close relatives audit. Clear? So close relative of the team working in your senior position of the client's company. Sir, your father is a director in a company and you're taking that company only. Your mother is a director. Your wife is a director. Such companies and all you don't take as client at all. And that is exactly why under 141.3 again disqualification they have put, saying if you are an auditor and your relative is in the position of management as a director or key managerial personnel, you are straight away disqualified. But as an operational level employees, you can be no problems for us. Clear? Former partner of the firm being a director or senior employee of the client, don't include him in the team. Because he was a director in the client's place. This time if you give him the audit, he will hide all the mistakes that he has done. Long association between CA and client counterparts. Sir, what do you mean by this, sir? Long association means what? What happened in Satyam now because of this only? Clear? Now you are having a very good association with your client for decades together. Don't you think now you are very familiar with their business? Definitely yes. You will only be involved in their business and you will tell them how to route certain money. Clear? Like in 6 months to 7 months, you become very good friends in your class. Money is not involved. Imagine in a company where you are a CA and company is dealing in crores of revenue and they will offer you something. How can you say that I will not be involved in certain things? Clear? Definitely will be involved in certain things. To curb that, only 5-year rule came into the picture in Companies Act. Clear? A CA can become maximum CA for 5 years in that particular company and then vacation for you. Vacation for the next 5 years. Clear? To avoid these type of threats only. Acceptance of significant gifts of hospitality from the client company. Imagine you finished your audit. Now he comes and gives you a BMW gift. Will you take it up? Will you take it up? You should not. Clear? You should not. Because it is a sign that tomorrow, now you owe him something. Clear? Right? But again, sir, that means should I not accept any gift? You can. Gift of gratitude you can. Clear? Now, sir, what if they say BMW only? Out of gratitude we are giving. Right? Now, recently Nayantara got a Rolls Royce. A 10 crore Rolls Royce her husband gifted. Like that, imagine a client gifts you a 10 crore Rolls Royce. What type of gratitude that is? That type of client, please let me know. I will not take up any other client. Yes? Now, that is not a gratitude gift. It is an attitude gift. Clear? Tomorrow, next year, he will definitely ask to do something very shady. Yeah, that's the reason why such things you have to be a little careful. You take hospitality, but you never budge your opinion. Clear? When I went for an audit, no, very good for me. The way I was treated, I got a feeling of a king there. Okay, 5-star hotel suite, executive suite booked. Okay, morning 9 o'clock, driver comes to pick me up. Okay, he will open the door for me. I should not touch the door. He will open the door. He will come and stand in front of the 5-star reception. Clear? He will receive me there. He will take me. He will drop me. Even when I got down from the client place, he will get down. He will open the door. I will have to get down, go, finish my work. Before I finish my work, 15 minutes, the client will call the driver. Keep the vehicle ready. Clear? He will drop me there. Clear? Again, he will salute now. I felt like I am a king of the client there. But all for this, for what? So that when opinion comes, when the financial statement finalization signature comes, the management will come and tell you, sir, I think we have taken care of you. Clear? Modified opinion, don't give, sir. Give unmodified opinion. Now my question to you, did I ask you for hospitality? No. Ketana? No, you gave it. Your problem. I will sign my opinion. Clear? So I had to sign, modified opinion. He said, don't sign modified opinion, give unmodified opinion. Clear? There was a mishap of 1 CR. Okay. Now that I understood why this treatment was given right from day one. Clear? So just to avoid reporting of such things, client will take care of you. You accept it, but at the end of the day, you give your opinion. Okay? You accept BMW, no problem. Next year. No, practically also. Practically also. But there are two things. There are ways where we accept gifts also, but at the end of the day, we say, okay, we'll give this opinion. Rest is up to you. See, it doesn't matter in private companies and all. Because private company at the end of the day, it's only your known members. Public company, significant gifts and all come in. Public company, private company will tell you, if not you, there is one more CA. No problem, go. Clear? Now, if all CAs are on the same page saying we will never budge our objective, we will always give an independent opinion, then yes. Clear? But yes, in some cases, theoretically only. Okay. Hospitality, yes, everywhere they'll give you well only. Gifts is a problem. Okay. Then intimidation threats. What is intimidation means? Me threatening you with certain negative results. Like for example, I am telling you I will replace you with some other CA if you don't do my work. If you don't give my opinion, I will replace you. That's intimidation threat. Pressure to disproportionately reduce fees in response to reduced fees. You told 10 lakh is your fees. I am giving only 5 lakh. Now you are telling, so for 5 lakh I can't work so much. Then reduce your work. Now if I reduce my work, it will affect my quality. But if you accept that, that means you have given into a threat. Therefore tomorrow they can hold you liable. Being threatened with litigation, saying I will file a case on you. Okay, these are the different types of threats. How do I put safeguards there to independence? First one, thoroughly consider whether you should take that work or not and whether it involves threats or not. If it involves threat, what you should do? Do not take up the task, or if you are bold enough to do it, put safeguards in place to eliminate them. Sir, if elimination also is not possible, then you must not accept the work. So basically, the moral of the story for independence is what? Try to put safeguards. First of all, don't accept only, but if you are okay with accepting it, then you have to put safeguards. If safeguards also is not possible, better you withdraw and close the matter. Okay. Next comes professional skepticism. What is professional skepticism? A, B, C. What is A, B, C? A for a questioning mind, B for being alert to condition, and C for critical evaluation of audit evidence. So there are three things here when we talk about professional skepticism. Questioning mind, meaning what? For everything we start questioning. Clear? Now every year you give provision of 10%, suddenly you give provision of 15%. I start having doubts on you. Therefore I start asking question, why, what happened, why are you giving more number of provision or more provision here? Then being alert to condition, meaning what? Suddenly you saw in one particular month, suddenly you saw increase in sales. Be careful. In the month of March, you saw increase in sales. Be careful. Yeah, why? Spike in sales at the financial year end to boost your profits. Sir, April month only I saw a big amount of sales return. That means previous year reported sales would have been fraud. Clear? So such things, be careful. Don't ignore it when you know that these are the conditions where you have to be careful. Then critical assessment of evidence. Whatever evidence you are getting, no, don't brush it off. Check every aspect of the evidence to give proper opinion. Point number B, professional skepticism includes being alert to following conditions. When evidence contradicts other evidence obtained. Sir, for same matter, I have two different responses. Example, bad debts, right, or debtors. Now debtors, 1 lakh is the outstanding amount. I go and take debtor confirmation. That fellow is saying 50,000. Company is saying 1 lakh. Same debtor, two different opinions. Be your alert mind should be, asking more and more questions. Then, if you are able to have a reliability, doubt, meaning what? I am not relying on the documentation, sir. This document I am doubting. Ask more question. Any information that brings into question the reliability of documents, then ask more question. Example, duplicate invoices or duplicate agreements. In such cases, be little careful. Then, conditions that may indicate a possible fraud, because fraud is always intentional, so be careful there. Next, circumstance that suggests the need for procedures in addition to SA requirement, meaning I have to put more procedures. Generally, we don't put more procedures, but in certain clients' place, we put more procedures. That gives us an indication that something is wrong. It doesn't mean things are wrong, but something could be wrong. Maintaining skepticism is important. Why? To reduce the risk of three things. Number one, overlooking unusual circumstances. What is overlook? Ignoring unusual circumstance. Ignoring unusual circumstance means, imagine they never do a provision of more than 10% for debtors. Suddenly they make a provision of 20% only for one debtor. It is unusual for me. And in those unusual circumstances, I should never ignore it. I should start asking question. Who is this? Clear? And why only for this particular debtor 20% you are creating, and why not for others? If it is actually a debtor, show me the bill, show me the invoice, give me the number, I will go and take the direct confirmation. So put more procedures. Over generalizing when drawing conclusions from audit observation. Classic example, one of the bar and restaurant during COVID, financial year 2021 and 1920, they reported less income to the income tax. Clear? That is one of the worst thing a client can do, because in COVID year, only one industry boomed, that is alcohol. Clear? So alcohol, business made humongous amount of profits during COVID, especially during the lockdown times. And one of our client went and reported to the income tax saying, we didn't make enough income in this year. That fellow got angry, sent a 19-page notice, officer, saying for the last 3 years, every debit entry and every credit entry should be explained to me. Clear? And we literally had to request him to, sir, please don't. Last 3 years you are asking for a business current account. Last 3 years now, 1 year will be spent. I don't know. How can he say he doesn't have income? That too bar. I understand restaurant. This is bar. And I myself know how much I drink. And I am like, oh, we are like, okay, sir, we will ensure that we will give response on time. Clear? Now we have to understand that when you're lying like this, there should be some basis for that. Clear? Left, right, center, if you're telling, now we can't generalize. Right? Now, income tax officer, if you had generalized, now, maybe, could be. How is it possible? Because the data shows different thing only. Clear? So like this, if you're telling, it is wrong. Inappropriate assumptions while deciding the procedures. Sir, imagine management has lied to you and you know that it is a lie, but you're like, hey, it's okay. Maybe he is into situations where you want to lie. Maybe it is not a lie. Why that maybe you're getting? Go and get a clarification. No. Why is he lying? Right? So you are using inappropriate assumptions. Be more careful. You have to use professional skepticism to reduce the risk of ignorance, over generalizing, using inappropriate assumptions, and also it includes consideration of sufficient and appropriateness of evidence obtained. So you have evidence, yes, but it should be sufficient also, it should be appropriate also. For that, your professional skepticism will come into the picture. This is a very big concept in the entire audit. Although here it is only so much, the application is pretty big. So be careful when it comes to professional skepticism. Clear? Acceptance and continuance, now we will not be doing it because in SQC1 we will be doing this. SA 210, agreeing to the terms of audit engagement. Should we agree to the terms of engagement before? When should we apply this particular standard? Before accepting or after accepting? Before accepting the audit. Clear? First we should deal with whether we should accept or not. Number one, what is the objective? As per SA 210, agreeing the terms of engagement, the objective is to see whether we should accept the client or continue the client with two things. Establishing whether preconditions are present, meaning I have some conditions. If those conditions are there, I will take up the audit. If those conditions are not there, I will ignore the audit. And confirming that there is a common understanding between auditor and management, and wherever appropriate, TCWG. So basically with the client and auditor, there should be a common agreement. What are the preconditions? Very important. Multiple times I have asked this question. What are the preconditions? Number one, determine whether FRF is acceptable or not. Imagine I am a CA. In my office, we never practice trust. Now you come to me and saying, sir, I have a trust. Will you audit my trust or not? Should I accept it or not? I will not accept because for me FRF is not acceptable. So first of all, see whether FRF is acceptable before judging the client. If it is not acceptable, do not accept the engagement. If it is not acceptable, do not accept it. Second, obtain agreement of management that it acknowledges and understands its responsibility. What is its responsibility? Preparation of financial statement is their responsibility. Internal control system is their responsibility. And to give us information. What type of information? All information with respect to financial statements. Any additional information we think is important, and give unrestricted access to people within the entity. And this is pretty important. Unrestricted access to people within the entity, not debtors, creditors, etc. Clear? For them, we have to take specific permission under SA 505. Whereas here, I need not take specific permission if I have to question your employees. If I have to question your CEO, I don't need specific authorization. In this only, you will give me authorization. Clear? If this is not present, do not accept the audit. If this is present, accept the audit. Next, agreement on engagement terms. That audit engagement letter is what we studied in chapter number 1. The contents of that is given in chapter number 11. What should be there in audit engagement letter, sir? Number 1, objective and scope of the audit of financial statements. What is my objective, rare, and what is my scope? Then, what are my responsibilities? What are your responsibilities? Just now we saw what is management's responsibility? Financial statements, ICS, giving me the information. Then, identification of AFRF. Which AFRF is applied for this particular client? And reference to the expected form and context or content with a statement that this may change going forward. So I am just giving them a reference. It is not actual content. It's not actual content. It's just a reference as to this is how the reports look like, but there may be a situation in which report may differ from its expected form and content, and that circumstances is based on your integrity, objectivity, etc. If the client lies, then I should modify my opinion. Clear? Okay. What happens if preconditions are not present? Like I said, first discuss the matter, then do not accept it. Okay. May 25, 5 marks they had asked on essay 210. Very easy question they had asked. Limitation on scope prior to accepting the engagement. Before accepting, only if you put limitation on my life, I will not accept you as my client. Clear? Don't do this, don't do that. I will not accept you if you put such limitation. Before I accept the audit, do not accept such limited engagement. Or you give disclaimer of opinion and close it. Okay. Acceptance of change important. If imagine I am already doing the audit. You have appointed me for doing the audit. Now, you want me to do review. I accepted audit. You want me to do review. Which is better assurance now? Audit or review? Audit. So from audit, when I am coming to review, am I scaling up or am I scaling down? I'm scaling down. So am I giving you better opinion or less better opinion? Less better opinion. And in that case, I need to think twice before accepting the engagement. Whereas I have already accepted review. You are asking me to do audit. Which is better? Review to audit or audit to review? Review to audit is better. In that case, I will straight away accept it. Clear? But if it is audit to review, then I cannot accept straight away. If it is review to audit, I can accept straight away, no problem for me. So this acceptance come only in one case where before completion, you are requested to change the engagement to the one which provides a lower level of assurance, not a higher level of assurance. Clear? So from audit to review, this particular point will come into the picture. Review to audit, it provides a higher level of assurance, no problem for that. Now, when should I accept or not depends on the request. Why are you making this request? If you are making this request because of circumstances affecting the need for service. Imagine the law suddenly changed and the law said you have to give a reviewed financial statements within the next 1 week. Now I have appointed CA for auditing. Now I am telling him, sir, audit is not required now. Audit venda, sir. Why? Because they are asking for review. So can you please do a review and give? Now in that case, don't you think it is reasonable for me to accept it? Yes, because law only saying, don't want. Sir, management voluntarily appointed you for audit. Bank told the client, I want your audited financial statements. So the client appointed you for audit. Now suddenly bank is telling, sir, audit is not required, sir. I got some information. You give me a review of that. I don't want full audit. Just in the next 3 days, you give me a report. I will process the loan. Now client is coming to you and telling, so audit is not required, sir. Go and give a review, sir. Should I accept such engagement? Yes, because it is a circumstance. See, if the client does not want my services, I can't force because of the circumstance. Clear? Number 2, misunderstanding, sir. Client did not know what is audit, what is review. Clear? I told audit, he understood review. He said okay for that. When I'm doing the audit, he's like, sir, I audit don't want, sir. You do review. Should I accept it? Yes, because it is a misunderstanding. It's reasonable to accept. Clear? It is misunderstanding. Third, restriction on scope of engagement, whether imposed by or caused by circumstances. This is not reasonable because imagine I was doing the audit and I got to know that there is a fake data. And I am telling the management, give me authorization for external confirmation. Management is saying, you do one thing, you don't have to do audit and all, you do review and leave. You are asking too many questions with me, don't do audit, you do review and leave. Now should I accept such engagement? No. In that case, I can withdraw. I can say, do one thing, I will not do anything. Okay? I will quit the engagement here. I will drop this. You find some other CA. Clear? So in point number 3, it is unreasonable for me to change it. But point number 1 and 2 becomes more reasonable compared to point number 3. Consider carefully the reason given for the request, particularly the implications of a restriction on scope. What is reasonable? Change in circumstances is reasonable. Misunderstanding is reasonable. Other than that, nothing is reasonable. Change may not be considered reasonable if it appears that it relates to information that is incorrect, incomplete or unsatisfactory. This is what I questioned about debtors and he asked me to change the work, not reasonable. Should I accept or not? If you accept it, if you say yes, it is reasonable, I will go to review, then you should not give old report, you should give a new report. If there is a justification for change, then report issued would be appropriate based on revised terms. But in the new report, do not include two things. One is original engagement and one is any procedures you have put in the original engagement. See, if you have changed your person, no, don't talk about the past. Original, it will confuse them. Clear? Don't talk. Original engagement, whatever you have done, let it be there. Whatever procedures also you have put in the original engagement, let it be there. You are confusing the user now. He won't be able to take proper decision. Clear? And I'm still talking about audit itself. Right? Next, you should not agree to a change of engagement if there is no reasonable justification. Imagine client comes and says, sir, audit don't want to do review. Why? Summa, sir. Summa, I can't. Scale down. Clear? I will do audit. If you don't want, I will quit the engagement. Okay? Agreement on new terms should be recorded now. New engagement letter should be drafted. Clear? Record the new terms of engagement in new engagement letter or other suitable form of written agreement. If the auditor is unable to agree, then withdraw from the engagement, or if there is any obligation to report it. Tell the regulator, see, I was doing audit. This fellow asked me to do review and I'm not doing it. That's why I'm withdrawing. One copy of that you give it to SEBI or MCA or government and quit. They will take care of him. Clear? This is the entire concept of acceptance of change. Clear? Important. Next comes recurring audits. What is recurring audits? Every year I am only doing the audit. Do I need to revise the terms every year? Need not. Do I need to remind the terms every year? Need not. Therefore, in what circumstances I should remind or I should revise? Number one, if entity misunderstands the objective and scope, then I need to remind them or I need to revise the terms. Number two, revise or special terms of engagement. Let's say, for example, you want to charge more fees now. Clear? Therefore, terms will be different. Senior management changes. Of course, I need to change my terms because the old terms were agreed by old management. Now there is a new management. Change in ownership. Management is still the same, but owner changed. The old approval was given by old management based on old owner. Now owner is different. Therefore, management also will be changed. Not person. The way of working can be different. Clear? Change in the nature or size of business. Last year you are not growing. This year you have like 4 branches. Therefore, I need to audit all 4. My work will increase. Therefore, terms should be changed. Change in legal or regulatory requirements. Sir, law changed. From company law 1956 it went to 2013. More reporting is required. Therefore, I need to change my terms. Change in FRF adopted in the preparation of FS. From normal T format balance sheet we are going to Schedule 3 format and accordingly I need to work. Change in other reporting requirements. From CARO 2016 I am moving to CARO 2020. Clear? In such case, this will be my problem where I have to report specifically now. Clear? Then comes audit quality where SQC1 and SA 220 comes into the picture. Main difference you understand, and this particular concept is easy for us. Clear? SQC is bigger, SA 220 is smaller. It is very similar like how this diagram looks. If this is SQC, this is SA 220. Clear? SQC is for firm. SA 220 is for specific engagement. Therefore, this will be applicable at firm level and this will be applicable at engagement level. Clear? Now, both talk about quality control only. SQC1 applies for the firm. SA 220 is applicable for audit engagement. SQC all engagement. This is important for multiple choice question MCQ. Okay. Now, SQC1 asks the firm to establish quality control policies and procedure. Same logic for engagement also should be there. Okay. So, SQC1 requires what? Firm should establish system of quality control designed to provide that my firm and my people should be doing the work as per professional standards. Now, why are we putting such standards? Because your firm and people in the firm, whatever work they are doing, they can't do whatever and however they want. They have to perform as per professional standards. Now, that is the requirement of SQC. Now, if I have to give the requirement of SQC, then I need to also think of one more logic. That logic is, sir, SQC is asking you to do this. So how do I do it? In my firm, when I put procedures in every department, automatically quality improves. Therefore, SQC1 objective is met. Clear? Objective is very clear here. Your firm and people should do the work professionally, and whatever reports you are issuing should be appropriate. Meaning inappropriate reports should not be given. If it is no misstatements, you can't give modified. If there are misstatements, you can't give unmodified. That type of work your firm should have. Now, there are 6 elements we need to talk about under SQC1. First element is leadership. Second element is ethical requirements. Third element is acceptance and continuance. Fourth element is human resource. Fifth is engagement performance. And sixth is, now same thing is repeated for SA 220. Right? First is leadership qualities, then relevant ethical requirements, and acceptance, engagement, performance, and monitoring. Clear? Right. First is leadership responsibilities. Who is the responsible person in the firm? Who is the firm's head managing partner? Or we can call him CEO. Right? So one of these will be ultimately responsible for it. Now under them there will be people working. Yes. So if you have assigned persons for operational responsibility, then also CEO and managing partner will be liable. But standard says when you are giving that job to someone, ensure that someone has experience, he has ability, and he has authority to assume that responsibility. At the end of the day, who is responsible? Anything happens in the firm? CEO or managing partner. Okay. Even if their subordinates makes mistake, the boss will be liable. Ethical requirements. Who should have ethical requirements? Firm and people working in the firm. That means how you should deal with this particular element, sir. The firm should communicate the independence to their people. Like some of the firms will have first day orientation, what we stand for, how we are working, work culture, work environment and all. Clear? Now that firm should communicate to personal. Firm to firm it will differ. Clear? Some of the firms will never take up the clients if the clients only does not prepare books of accounts. Clear? They will never take. That's their policy. Some of the firms will take both books of accounts also, financial statements also. I should train my people. What if my person goes and says, yeah, we'll do books of accounts, and we don't do it? So that means I am not having a quality in my office. Therefore, I need to communicate my independence. With respect to independence, what do I communicate? 4 marks hidden question can be asked. Number 1, identify and evaluate the relationships that creates threats. Meaning, in case of any related party comes into the office for audit, we should not take. Number 1. Number 2, if in case you have accepted them, try to eliminate those threats. If elimination is not possible, reduce them. Reduction also not possible, withdraw. Withdrawal is the last thing we will do. First we'll try to eliminate. Not possible, reduction. Not possible, withdraw. Clear? All breaches should be promptly notified to the firm because firm should take action and not any one individual. Fundamental principles as usual, IPCCO should be followed as well as independence should be followed. Third, acceptance and continuance of clients. Should I accept the client? Should I continue the client? That depends on information given to me. If the client is good, I can accept him. If the client is not good, I cannot accept him. Now, how do I know whether a client is good or not? 3 things you have to evaluate. 1, integrity of the client. I have integrity. My client also should have integrity. What if he is a liar? What if he is dealing in black money business? What if he is dealing in fraud business, criminal activity? Should I take him as a client? No, tomorrow even I will be liable, criminally liable for that. Okay. So first I need to talk about integrity of the client. His reputation you get to know in the market. Once his reputation you get to know, see what type of business he is doing. What if his business involves a lot of cash activities? Clear? Third, concerning the attitude of the owner's management, etc. towards interpretation of accounting standards. Meaning, for example, my client came and told me, sir, please do my audit. I said, okay, for you, Ind AS is applicable. Client is like, hey, Ind AS and all, you use it, you follow AS. Now, it is not about his fraud, etc. Is that the interpretation of accounting standards are not there. Now, if he is not letting me work under Ind AS, I will not accept him as my client. Clear? Then, whether he is aggressively concerned about maintaining the firm's fee as low as possible. Meaning, he is not concerned about quality. He is bothered about what? Paying less and less fees. Now, you tell me, if somebody pays you lesser fees, will you work more? Very simple. Clear? So, because quality will be affected. Then, inappropriate limitation in the scope of work. If he is giving an indication that I am putting limitations, sir, don't do this, don't do that and all, don't accept such people where they are putting more and more limitation on your scope. Indication that client might be involved in money laundering or other criminal activities. What is money laundering? Conversion of illegal money into legal money. And criminal activities, imagine now he is involved in these organ trafficking, clear, then medicine waste, drug racket, all these things are now criminal activities. Please don't come to my office, because with great difficulty I got the degree. I don't want to go. I don't want to be a criminal accountant. I want to be a chartered accountant. Don't accept such clients. The reasons for the proposed appointment and non-reappointment of the previous. Why did you leave X and accept me? Firm. Clear? There could be some difference of opinion. Now, this is for this only. No. ICA has one more rule. You cannot accept a client unless you talk to previous CA. Clear? You have to go and communicate with them as to why this client is leaving you and coming to me. Because clients are always like that only. They keep shifting from CA to CA. Okay? And they blame CA only. When they go to new CA, they blame the old CA, because CAs always assume that accountants do not know everything. Clear? So it is not always like that. So there was one client, every 2 years this client will change CA. Clear? After some point of time, the entire circle got to know that this person changes once in 2 years. Okay? So when that person comes only, we'll ask, no, what is it? That person used to blame old CA. In front of the accountant only, one of the CA called. Wait, I will ask. So he called, he asked, and then everything was told. And then he's like, see, don't blame the old CA randomly. Accept your mistake. The mistake was this client never prepares proper books of accounts. Never gives the books of accounts on time. September 30th due date, 28th you come and give books of accounts for audit. In 2 days you have to finish audit. Clear? So what will the other CA do? He will leave. Clear? And this client has to go to some other CA. Clear? There are clients who have come on 30th September only for 30th September due date. Now should we accept it? No, we cannot accept such clients. Then competence of the team. Sir, client is good. My team is not good. Clear? We have accepted company, but my team haven't audited company at all. Should I accept such clients? No. Here, client is not problematic. Here, team is problematic for me. Clear? Then, compliance with ethical requirement by the firm and team. Sir, you are good. My firm and my team is there. No. The moment you say bribe, that fellow will open his mouth in my team. I can't accept such clients. Either I have to fire him. Clear? Now imagine that fellow is very good in work. Brilliant knowledge he has. But he wants a client who will bribe him. If the client bribes, no, that fellow will feed on that. Clear? I don't want such particular client where you are, or I will accept you, but I will put a different team in place. Clear? Such things are there. So it's not always a client will be a problem. For us, even our team will be a problem. Clear? When should I obtain this information, sir? Before accepting an engagement with a new client. Therefore, new work, new client. Second, when deciding whether to continue an existing work, old client. Then, when considering acceptance of new engagement with the existing client, that is new work, old client. Other things not possible. What is that? New client, old work, not possible. If the client is there, obviously work will be there. Okay. If there is any conflict of interest, it should be resolved before accepting. Policies and procedures should consider information obtained. Sir, imagine I got one information. If you had told me this information while accepting, I would have rejected you then only. Criminal activities he never told. Okay, imagine, for example, I got the financial statements. I am reading in P&L there is 1.5 crore other income. I asked him what is this other income. He said, actually last year I got a contract for murdering someone and that is that money. Now he didn't tell me anything about this before. Clear? After I accepted the work, he's telling me I signed engagement letter and all now. Now, will I be involved in that also? Yes. What should I do? Better you withdraw from the engagement the moment you get to know. Clear? So, consider in such information, what should I do? Do I have a responsibility to report to the regulatory authorities or people who appointed me? Number one. Number two, possibility of withdrawing from both client also, work also. Or should I withdraw only from work? Client is good. Client has 4 businesses. In this business, there is some flaw. I can only withdraw from this business and other 3 business I can handle. Understood? Next, human resource. Nothing in this very less, rare to rare, remote possibility of asking question. Human resource is nothing but your firm should have right type of people with proper competence, qualification, knowledge and skill. Clear? So that means when you are appointing, training them, appointing them, recruiting them, allocating work, in this you should have proper policies and procedures. Engagement performance is important. 5th element, engagement performance is important. Now, what do you mean by engagement performance? Actually doing the work or actually performing the work. In this case, I need to check consistency is achieved through what? 5 things. Very good question can be asked in the exam. Consistency in quality of performance will be achieved by 5 things. First step, briefing my team. I should tell my team what is important, what is not important, and where we are standing, what is our firm's quality, all those things I should brief them. Then process for complying with standards. Now we have so many standards, we should comply with them. So I should tell my team, see pa, if you have any doubts, you directly don't take decision, you talk to the senior article. If senior article is not able to answer you, go and talk to the manager. If manager is not able to answer, come and talk to me. So I should tell them this is a process to comply with the standard. Supervision and training. I should train my articles, I should train my staff to ensure my quality is there. Methods of reviewing, one-way review, two-way review. Should I only review or me after me senior article, manager, boss, what type of review we should have? Should we have a monthly review? Should we have a weekly review, etc. Appropriate documentation, whatever I should tell my team, whatever you discuss, put a documentation in it. For example, drop a mail for it. Clear? WhatsApp communication mails. There should be documentation. Tomorrow, person should not tell no that I have not told you or I have told you. So you should drop a mail right away or have a communication. Okay. If there is any difficult matter or any argumentative matter, it is better you take consultation. This consultation you can take from within the firm or outside the firm. Imagine you have some very difficult matter. Let's say insurance. In case of insurance audit, they'll have to create provision for claims. Okay. Now you tell me, can you sit and tell how many people will die next financial year? No, we do not know. Therefore, we will talk to actuary. He is an expert. It's a difficult matter. Go and talk to expert. Or in our firm only, we have an actuary. We can go and talk to him. So consultation you can take from within the firm or this is important. Okay. In the exam, they can test you here. Consultation can from anyone we can take because we are not taking decision. We are just taking what? Consultation and input we are taking. But they should have proper expertise to resolve a difficult or contentious matter. Contentious means argumentative matter. Okay. Significant judgments, whatever you have made in your work, should be reviewed by Engagement Quality Control Reviewer, EQCR. Sir, what if there is a difference of opinion? If there is a difference of opinion, you resolve that. Only after that you should issue a report. With the difference of opinion, you should never issue a report. Assembly of audit files, Institute's favorite question. Why? Within how many days I should assemble the audit file? Within 60 days of audit report, I should assemble. Meaning, today you finished your audit, you gave the report today. From now, 60 days you have to count. So, let's say for example, tomorrow inclusive of tomorrow's date, count 60 days and then only you will get. So, today is 8th December. So imagine today I give my report. Therefore, 9th December onwards starts 60 days. Within 60 days, I'm supposed to collate all the files and keep as a documentation part. Sir, why so many rules? Because tomorrow there will be a peer review. Anyone CA will come and check your office whether you have followed rules or regulations or not. If you have not followed, he will report you to ICA. Clear? And right now there's a rule where for listed companies, if you have to do audit of listed companies, you should have a peer review certificate. And peer review certificate, if you do not have, then you will not be able to go and do a listed company audit. They will never choose you. Clear? Their revenue is bigger, right? So therefore, if you want to do that, you get a peer review done. And for peer review, these all standards should be followed. Clear? Then engagement documentation is a property of the firm. If you want, he can disclose. We already discussed this. You can disclose it provided client has given you permission or law is asking you to give it. Ensure you are not compromising on the validity of the firm's independence, meaning you are not affecting the firm's independence. Give it, but ensure you have quality in your work. In case of assurance engagement, you have to retain the documentation. Maintaining documentation is different, retaining is different. You have to finish the documentation within 60 days, but retention is for 7 years. Salah for a reason. 7 years from the date of audit report you have to retain. Okay. Monitoring. What is the purpose of monitoring, sir? At the end of the audit, we have to monitor. But what is the purpose of monitoring? 3 marks, past question this is. Okay. Number 1, adherence to standards and requirements. What is adherence means? Compliance. We are following. Because we are having a review system, supervision and all, everyone follows a professional standards and requirements. Whether quality control system is designed and effectively implemented. Having QCS is not important. Executing QCS is important. You have a very good timetable. Does that mean you will become CA? No, the timetable should be executed. Quality control system design is not important. Designing as well as implementation is very, very important. Third, whether firm's QCPP, what is QCPP? Quality control policies and procedures have been appropriately applied so that reports that are issued are appropriate. So your quality control policy should be very good to ensure that we are giving appropriate reports. Moral of the story, you are not learning anything new in monitoring. Technically, if you check, point number A and point number C is an objective of SQC1. Clear? Objective of SQC1 is where firm and people should comply with the requirements, which is point number A. Second one, give appropriate report in the circumstances, that is point number C. In between, there is a process where the system should be designed and implemented. Clear? Think that way, because in every concept, no, there is an objective. You start with an objective, you end with an objective. Clear? If you don't reach the objective, then there is no point of studying the standard. Clear? So for 3 marks, they have asked this question before. Be careful. Right? Next, SA 220 talks about quality control for only specifically what? Audit. Whereas SQC1 for all audit, review, PFI, your agreed upon procedures, compilation, for everything it is applicable. Whereas in SA 220 specifically for audit alone. What is the objective? 2 things. Audit complies with standards and requirements, and report issued are appropriate. Again, same as SQC1. I'll give you a super tip. Study SQC1 first properly. Clear? SA 220 is copy paste. Don't have to worry about SA 220. Because if you see here, the bigger circle is SQC. You study this properly, SA 220 is easy. Now, same 6 elements are there. Leadership responsibility. In case of SQC1, who is the leader? CEO or managing partner. Whereas in case of SA 220, here there is no CEO managing partner. Here it is engagement partner. So he is liable here. Engagement partner is the boss of the audit, every individual audit. What he should emphasize, meaning he should always stress on 2 things. Importance of quality and fact that quality is essential. Now, how do I ensure importance of quality? He should ensure that whatever work is performed, it should comply with standards and requirements. Ultimately, it is his responsibility. His article may skip certain steps. He should skip the article only after that. Clear? He should tell articles, if you don't do this, then you are out of the team. Clear? Because standards are very important. Comply with firm's QCPP and procedures. Engagement partner can't put your own decision going beyond the firm. Whatever firm has decided, you have to follow that. Issuing reports that are appropriate and the team's ability to raise concerns without the fear of reprisal. Meaning, sir, my team should be able to come and ask me doubts. The team should be able to come and tell me if there is anything wrong. That type of environment engagement partner should create. Clear? This is your May 25 5 marks question. Just these two things. Clear? Easy question this is. Don't mess it up. Only 2 points you have to remember. One is the engagement partner is responsible. Second one, he should emphasize on what? Importance of quality and fact that quality is essential. Next, relevant ethical requirements. What should engagement partner do? Identify the threat. Clear? Report to the firm. Sir, logic here. In firm also, all put together come and take decision. In audit also, you can't fire a client, you can't fire an article as and when you want because you are representing the firm. So in case if there is any threat, you can't take direct actions. You have to go and talk to whom? Firm. Report to the firm and firm will take action. Then, reporting to the by the partner to the firm. Why? To determine appropriate action including withdrawing from the client. Then acceptance and continuance, same as SQC1, ditto, integrity, competence, etc. Same to same. Next, engagement of, assignment of engagement team. How should my team be mixed, sir? There should be a mixture of experience as well as youngsters, freshers. Otherwise, you will never learn. So I need to see, do I need to involve experts who are not a part of my team? If yes, when do I need them? And how many experts do I need? So, should be ensured by the partner that team and any expert who are not part of the team should have proper competence and capability. These are the keywords. Competence and capability so that they work as per standards and requirements. Engagement performance is important in SA 220. Engagement partner is responsible for all the performances. What he should do then? He is responsible for number 1, direction, supervision and performance. If anyone does not perform, will be questioned. Engagement partner. If somebody has skipped procedure, who will be responsible? Engagement partner. Then he is responsible for giving proper report. Imagine work is done by senior article, right? Senior article told no misstatement. He gave unmodified opinion. Later on it was found there was misstatement. Who is responsible? Senior article or engagement partner? Engagement partner. Because at the end of the day, who is accountable? Engagement partner. Clear? Then review of documentation before issuing the report. Appropriate consultation in case of difficult or contentious matters. For all these things, who is responsible? Engagement partner. Clear? Number 1, direction, supervision, performance. Then giving appropriate report, documentation, consultation. Then for audit of listed companies, you have to have EQCR done. Your engagement quality control review must be done if you are a listed entities. But firm can decide on other entities. Other than listed, it is firm's choice. If firm say, no sir, for others also we will put EQCR, then for others also it will be applicable. But whether firm say it or not, for listed company it is mandatory. What we should say, engagement partner should check 3 things. Whether EQCR has been appointed or not, if it is applicable. Number 2, have you discussed any significant matters with them? Number 3, auditor's report should be dated after the review. Your audit report must be dated after the EQCR, not before EQCR. On this, a case can be nicely drafted. Be a little careful here. Next comes monitoring. Now in SA 220, when we are doing monitoring, what should we document? Sir, in SQC1 also monitoring is there. But now how do you distinguish between that question and this question? That question talks about purpose. This question talks about documentation. Clear? So SA 220 talks about documentation, whereas SQC1 talks about purpose of monitoring. What should I document? Whatever issues you have identified, whatever conclusions you have on independence requirement, that is threats, whatever threats you have identified, whatever safeguards you have put, all those things must be documented. Conclusions reached on acceptance and continuance. Whether should I accept the client or continue the client, on what basis you have concluded, that you have to document it. Nature, scope on conclusions resulting from consultation which we have taken, whether SQC1 or SA220. If there is a difficult matter, I need to take consultation. I gave an example of insurance company. Clear. Similarly, for a tech company, whether, for example, let's say ArivuPro is a tech company, and in ArivuPro, when we are doing audit, I check the systems. They are saying the system is designed in this manner. I am a CA. I don't understand these things. So who will I consult with? An expert. So I'll tell, please ask the software engineer to come. He should explain it to me. I will ask my doubts to him. So whatever consultation I took, that documentation must be maintained in SA220. Everything. Even if you have told hi, maintain a documentation. Much better to be on the safer side tomorrow. Clear? This can be asked for a 4-mark question. I am repeating again. If it is a SQC1 monitoring question, you have to write why we are having that policy. Clear? If it is SA220 monitoring question, what should be documented? There is no why. Because why is already addressed in a bigger concept. Here, why will not be addressed. Here, what type of documentation I should maintain? Issues, conclusions. Clear? 3 conclusions. What is the first conclusion? Independence requirement. Second conclusion, acceptance and continuance. Third conclusion, with respect to consultation. Very simple. 2 things. I repeat again. Issues, conclusions. Issues with respect to what identified during the audit for ethical requirements. Conclusions are 3 things. Number 1, independence. Number 2, acceptance and continuance. And number 3, consultations. Got it? Yes. This is your monitoring part. Let's do the questions. Question number 1. What is the requirement? Whose view is proper? Therefore, it is a case. CAX has been offered audit of financial statements of TDK Industries, a partnership firm. Prior to accepting proposed offer, he insists upon obtaining agreement of management regarding acknowledgement of responsibility. So he wants management responsibility letter. Clear? Preconditions, basically. Now, what is management saying? However, management is of the view that it is duty to detect material misstatement, and such an insistence is totally uncalled for. Meaning, management is saying you can't ask such things. Who is right? CA or management? CA says I want responsibility letter. Management says it is not your job. You do your job. See who is right? Of course. Also discuss reasons for arriving at your conclusion. What should be the likely proper course of action? If write preconditions. If preconditions are not met, don't accept it. If preconditions are met, accept it. That's question number 1. Question number 2. ABC and Associates, an audit firm, has been approached by a prospective company client that has been in business for about 10 years to conduct an audit. Before accepting the audit engagement, the firm wants to access integrity of prospective client. Straight away they have given. Now this is SQC1 or SA220. Doesn't matter for me because both the answers are same. Clear? But they have clearly told it's an audit firm approached by a prospective company, right? And they want to conduct an audit of financial statements. Therefore, it is actually SA220, but ultimately we'll have to write SQC1 points only because both contents are same. Then, CA Sudhakar has been appointed as the auditor of Amro Limited. Before accepting the appointment, he learns that his cousin who held shares recently passed away without children, named him as nominee for these shares, which have substantial value. Although holding such shares to a distant relative does not violate legal provisions or affect his independence, this unexpected inheritance places him in dilemma. Advise CA Sudhakar on how he should deal with this situation and safeguard his independence. What he should do? This comes under familiarity threats now, or rather advocacy threats. Clear? Where you are having shares of the company, ultimately will end up giving good opinion about the company. Either you should not accept such shares or you should not accept such audit. One of them. Clear? You have to sell it and then accept it or give it to someone else. Clear? Next. CAH is managing partner of HK & Co., a CA firm having a registered office in Delhi, with the annual task of reviewing whether any threats to independence is observed. Following observations are received. CAJ, partner of the firm, performs statutory as well as non-audit engagement which threat it is? Self-review threats, because you are only doing the non-audit engagement, you are also doing the audit engagement. Both are done by you only. Self-review threats. CAM partner of the firm who has done income tax audit of Messrs. Happy Associates, wherein CAM has material significant indirect financial interest. Self-interest threats. Cost of air travel, stay, accommodation of family members of the audit team for audit of Chennai was borne by the client stationed at Chennai. Which is this? Hospitality or accepting? Familiarity. One of the clients, Mrs. Chalk Limited, threatened to replace them as auditors because the team insisted to make provision for expected credit loss, which the company was not willing to provide. What is this? Intimidation. Clear? Threatened to replace them as auditors. Clear? Intimidation. Next. CAN partner of the firm who audited Mrs. NM Private Limited became arbitrator for dispute between the client and one of the vendors. Advocacy threats. Accepted the assignment of tax audit of TRF. Management agreed to pay contingent fees. Self-interest threats. Clear? Now this was asked for 5 marks. Clear? After that, they'll say what you should do when such threat exists. Safeguard. Before accepting, see whether threats are there or not. If yes, desist. If not, place safeguards. If you are unable to place safeguards, withdraw. Clear? 5 marks. Next, identify and explain fundamental principles. See, again, this chapter gave easily 10 marks in Jan. Clear? And they consider Jan as difficult. Professional accountants should act diligently and in accordance with technical and professional standards. Which fundamental principle it is? Very good. Diligently word, if you see, it is due care. Therefore, professional behavior and professional competence and due care. Okay. Professional accountant shall not knowingly be associated with reports where he believes information contains materially false. I for integrity, I for information. They are spoken about information. Therefore, here it is integrity. Next. Request the auditor for change in the terms of engagement. Now you tell me, simple logic, you tell me if it is audit to review, directly acceptance or conditional acceptance? Conditional. Review to audit. SCA 210 will not even come into the picture. Now this they are asking what? The management has requested the auditor to change the terms of original engagement as the company has diversified its business and few new products have been introduced by the company. Whether CA Puneet can agree to the request made by the management, under which circumstances can the client make a request for change in the terms of engagement? So here you will have to write the concept first, then you will have to explain under what situation this comes into the picture. This is not limitation, this is due to the circumstances. But if you feel it is reasonable, then you can accept. If it is unreasonable, do not accept such change. But if it is reasonable, you have accepted the change, then you have to draft a new engagement letter and report should be as per new terms. And in the new report, 2 things you should not mention. One is with respect to original engagement, procedures performed under original engagement. Next, 7th one. CA Rohit, what is the exam is what they have told. Therefore, it is a case. CA Rohit is conducting audit of Taste Limited, a food production company, for the last 2 years. Before commencing for the audit of the year, he observed that company has undergone major shift in its product line by expanding into pharmaceuticals. Besides this, the company is now subject to new regulatory reporting requirements. These developments were not present at the time of accepting the engagement. CA Rohit is of the view that no need to issue a new engagement letter. Is that so? No, you have to issue new engagement letter because business has changed. Therefore, recurring audits concept will come into the picture. Clear? Next, enumerate the factors that may make it appropriate to revise the terms. Now, you see the pattern. Same concept they have asked in the September exam where they had asked the same concept in RTP. Clear? So, sometimes RTP questions copy paste concept. Clear? So, the question may not be same, but the concept is same. 9th one, mentioned below are the threats to independence. September 25, 4 marks, recent attempt. What are the here points you have tried? Close business relationship with the client. Self-interest. performing services are themselves subject matter of audit, deals with shares or security, long association with clients and auditors. Auditors stop from acting objectively with adequate degree of professional skepticism. Intimidation. I'm not letting you do your work. If you actually see same order also, no difference in order also. Clear? 4 marks they had asked. Understood? Clear? This is with respect to your chapter number 11, ethics and terms of engagement. We'll take a 10 to 15 minutes breather and then continue. Next, chapter number 6, audit documentation. Very big chapter number syllabus. The chapter itself is 4 pages. Right, audit documentation essay 230. Why documentation is important? 2 things we have to understand. What is documentation and why is it important first of all? Why is it important? Because it proves as an evidence, serves as a guide for us. Clear? Then, and in case of any, like for example, in one of the, let's say any client that you're working with, the transactions are huge. So many important things would be there. So to keep a track of significant matters identified in the audit, we require this particular standard audit documentation. So what do you mean by audit documentation? Very simple. It's a record of 3 things. Clear? Record of 3 things. One is procedures performed. Number 2, evidence obtained. Number 3, conclusions reached. Clear? So these are the 3 things. Technically, if you see, it comes from our cycle of audit only. It is nothing but what? Procedures performed is a record, evidence obtained and conclusions reached. So you don't have to sit and by heart with respect to that, try to understand the flow. And these 3 things are nothing but audit documentation. What is the objective of my, of an auditor when I take up this standard? It is a sufficient and appropriate record of the basis for my report. Tomorrow when somebody asks me on what basis you have given this report, then I should have a record to say on the basis of this only I give a report. Then it is an evidence that I planned and performed my audit as per the applicable standards and requirements. I did not do something beyond what is required. So that's my objective. Here objective and nature both are same. Okay, in the standard points are very, very similar. Just the context is different. Objective is why are we going to do it? Nature of it, what is documentation helping us in? Okay, but answer is same. In the exam, be careful when it comes to the questioning part of it. Objective if they ask, why are you doing it? Clear? Nature if they're asking, the documentation it serves as what? Serves as what? Now, what is the purpose, sir? Why do we need to have a documentation? Now, here, chapter is small, but very dangerous. Okay? Now, in the exam, when they're asking purpose of documentation, you will end up writing objective. That's the beauty of this chapter. Clear? You should not write objective. Clearly, when they're asking purpose, number 1. Number 2, there is one more question which they can ask and you will not know what to write, called advantages. When they ask advantages of audit documentation, you need to clearly understand that we are going to write what? Purpose of audit documentation. So basically, advantages here, we have 6 points to be writing. Number 1, assisting the team to plan and perform the audit. So basically, we are helping our team. First 2 points are with respect to helping. We are helping the team. We are helping the members of the team to direct and supervise. What is the difference? In the first one, we are helping the entire team. In the second one, in the team, whoever has review responsibilities, it will help them. They can keep a track of who is doing what. And other people who are executing it, they'll get to know what they are supposed to do. Remember, first point is for the entire team. Second point is those members who has direction responsibility, supervision responsibility and reviewing responsibility. Clear? It will help the team members to be accountable for their work. What does accountable means? Hold them liable. So basically here accountability is important. Next, retaining the record for future audit. Basically for future reference we can use this. Third, fifth one, internal inspection. Sixth one, external inspection. Remember that way. First 3 points is for the team. First one, entire team. Second one, review responsibility. Third one, accountable. Clear? Fourth one is for future. Fifth one is for internal inspection. Sixth one is for external inspection. Clear? 6 points, easy, 4 marks you can score. Come on, tell me again, what are the first 3 points with respect to the team? Number 1, entire team. Number 2, review responsibility. Number 3, accountable. Fourth one, future reference. Fifth one, internal inspection. Sixth one, external inspection. Internal inspection, SQC1 will come into the picture where firm comes and sees what work you have done. External inspection is ICA coming, SEBI asking, RBI asking, etc. Outside people coming and asking you. Form content and extent of documentation. Why we should prepare documentation? This hidden question, 3 marks they can ask you. We should prepare in such a way. Now see, this is a keyword you have to understand in the exam, in the question. It should help the experienced auditor having no previous connection with the audit. Meaning, tomorrow, imagine I was doing audit of my client, clear, for the last 10 years. Okay. Now, next year, imagine now Naveen becomes the auditor of that particular client. Now, Naveen has also an experienced CA, but my client was always with me from the last 10 years. This year, my client decides to move on. Now, the question is, when he moves on to another CA, Naveen has no connection with the client's audit. Even then, he should be able to understand what I have done. That type of documentation you are supposed to prepare. Tomorrow, any CA takes and reads, he'll understand what I have done. You know why that is? Tomorrow, if the CA is not there, who will explain? The documentation should explain. Clear? That is the logic. Imagine for my subject, I don't give you material at all. My explanation will understand. Now, how will you retain it? Through documentation. That is the reason why documentation should be prepared. So, he should understand what? Now, Naveen should understand 3 things. Nature, timing and extent of procedures performed. What type of procedures Karthik sir has performed? When was it performed? And how much was it performed? Nature means what type? Timing means when? Extent means how much procedure I have performed. Then the results of the procedures performed and evidence obtained. Because of the above procedures, what all results Karthik sir got? That should be documented. Third, significant matters arising during the audit and significant professional judgments made in reaching those conclusions. So basically important matters I will note it down, and Naveen will say, okay, what judgment Karthik sir has taken, that also should be noted down, because everywhere professional judgment will be there. Clear? Audit is equal to professional judgment only 90% of the time. So my judgment, the other CA should understand when my client changes the CA. So ICA says something that if a client asks that I don't want your services, I want someone else's services, you should be ready to let go of the client. You should not force the client. At the same time, quality should not be compromised. So your work is good, but the next CA who will be working, even his work should be good. For that, opening balance, closing balance, you took care of that. No. Next year when he is doing the audit, he should know how did I check it. And for that, this documentation should be given. Next, in documenting NTE of procedures performed, what all I should keep? Now observe this. 3 things I should notify. 3 things I should mention. What is that? What procedures I perform? What are the results? And what are the matters and judgments? Now, point number B is nothing but about this. NTE of procedures performed, details of it. What should I put? Number 1. What are the items or matters I have tested? So here, example, I told NTE of procedures performed, nature of procedures, I did sampling. Okay, timing, I did, let's say, during the planning phase. And extent, let's say, for example, I took 20% of the population. Now, this much I told. Will he get clarity more on that? No. He just gets to know that I've done sampling, 20% I've done, and during the planning phase I have done, or rather testing phase I have done. Now, more about that, where will we document in point number B? What all I should keep in mind? What items I have tested? Sampling, correct, for debtors. What type of debtors? Are they debtors only Coimbatore debtors or Chennai debtors or Bangalore debtors? What type of debtors? Debtors more than 10,000, less than 10,000, debtors more than 3 months outstanding or less than 3 months outstanding. What type of debtors? Clear? And what are the matters that I have tested? Who performed the work? I only signed it, but who performed it? Did an article perform or did CA perform or not? So if a CA performs, Naveen will get to know I can trust this information more. But if an article has performed, he will have some reservations. Clear? And date of such work. When was this work completed? If it is an old work, no, then he will say I think many information would have changed. So I can't trust an outdated work. And who reviewed the work and the date and extent of such review. Who reviewed it? When was it reviewed? And how much was it reviewed? So these will help in understanding what type of procedures Karthik sir has put. This was asked in RTP May 25. So be careful with respect to these. Clear? So if I was an examiner, no, I would ask you for 5 marks. I would have asked you 2 questions. One is point number A and one is point number B. Clear? Like how 5 marks can be divided into 3 and 2. Clear? So I would have asked this for 3 marks and I would have asked this for 2 marks. Be careful. Now, you should also document discussions of significant matters with TCWG, management and others. Classic way. I told you chapter is small. On this they have asked one case. Clear? Very good question they have asked on this. Point number C, point number D. Keeping that as a base, conceptual question they have asked. Okay. What should you document? Discussions with management and TCWG. What discussions I have made? Significant matters. And when did I make this discussion? With whom did I make this discussion? Management, correct. There could be many people in the management. Right now, ITC, 15 directors are there. There are some people from IAS and IRS background. No, they will not understand with respect to financial statements and other things. Clear? There are people who are totally like, for example, let's say chemical engineer, software engineer, who is a director. Right? Sun Pharma, if we take, there are people from medicine industry. Now, they may not understand commerce. So, with whom we are going to discuss it? That also should be written. Clear? If you identify information that is inconsistent with your final conclusion, document how did you solve that particular problem. Inconsistent means what? Not matching. Whatever information conclusion I have and whatever is the actual result, it is not matching. In that case, I should resolve this. With whom I will resolve? With the management. That resolution should be documented so that Naveen can understand how I resolved after talking to management. So that next year even he can have a heads up. These are the areas which Karthik sir was telling it is important. I think even I should be careful in these areas. Next important question is, in this you only have important question. Entire content is question. Form, content and extent depends on factors. In the exam, watch for this point. This word, because there are 2 questions they can ask. Form, content and extent, 2 questions they can ask. One is factors. If they ask factors, you have to write 7 points. But if they ask with respect to form, content, extent, this is the question you have to see. Enable an experienced auditor having no previous connection. Then you have to write point number A and B. Clear? If they ask with respect to how it will help an experienced CA, then write point number A, B. Clear? And C and D as well. But if they are asking with respect to specifically factors, how much documentation should be made, that you have to write 7 points. Clear? And this is the catchphrase of the question. Okay, what are the factors? Size and complexity of the entity. If the particular company is a very big company like Reliance, ITC and all, my documentation will automatically increase. But if it's a very small organization, proprietorship and all, I may not have too many documentation to do. Complexity. The business of the client is very complex to understand. Complex problem requires more documentation. Easy problems require less documentation. Nature of procedures performed. If the audit procedure that you are performing is very regular and everyone knows about it, then documentation will be less. But you are performing a procedure which is a combination of only your thinking. Then you have to document it more. Clear? Third, identified risk. If you tell me if risk is more, documentation should be more or less? More. If risk is less, documentation will be less. Significance of evidence obtained. You have obtained an evidence. It is very important. Should you maintain that evidence or not? Yes. But you have received an evidence which is not at all important. Should you maintain that evidence? Not necessary. Example, think and answer. If the client has given for 31st March, bank balance he has given evidence. 2 evidence he has given. One is banker's manager's certificate, signed certificate as on 31st March. Second he has given is a bank passbook. Which one will you maintain as a documentation? Manager's certificate. Why? More authentic than passbook. Now both are evidence, but which one will you document and keep? Certificate you will document, passbook will give it back to the client. Not required. Clear? Now here, significance. Which one did you consider significant? Manager certificate you considered significant, so document that. Passbook you need not document. Clear? Number two, second, sir, sales invoice is also given to you. Debtor, credit sales invoice is given to you. Debtor's confirmation also you have. Both are evidences for you. Which one will you document? Debtor's confirmation you will document and not invoice. So significance you have to see. Relative matter it is. Clear? So what if for me both are important? Maintain both. What if both are not important? Don't maintain both. But you should be able to explain tomorrow when I ask questions. Clear? Why? On what basis you have given this? Documentation, if it is not there, you are responsible for the answer. Clear? Then, nature and extent of exceptions identified. Sir, generally we will find these exceptions in every client. I need not document. Rare exceptions, I need to document. Clear? For example, generally in garment industry, returns will be more. Clear? Sales returns will be more. Don't you think so? Don't you think so? In garment industry, if I'm selling garments, clear, returns will be more. But sorry to put this particular example in the class right now, but I have to give when I talk about garment industry. But if it is inner garments, no, returns will be not there at all, unless and until it is a quality issue. Clear? If you have gone to any shops, you can try any clothing except innerwears. Innerwear they will not allow you to try at all. Clear? Because when supermarket started in our country, we had a problem of people exchanging their clothes without the tag. Right? So inner garments they will not allow you to try and keep it. But anything else you can try. Now in Myntra, Ajio, when you are buying garments, if it is not fitting you, color is not good, fit is not good, fabric is different, don't you return it? Yes. Compared to the other products you buy on Amazon, Myntra and all, belt, perfumes and all, when you're buying, return is very less. But garments, when you're buying, return is high in that aspect. So I know in garment industry, return is high, right? But in other industry, returns are less. So this is industry knowledge. Now, it is generally that sales return will be high in garment industry, not a big exception. But in case of washing machine, I am a company which is selling washing machine. Returns are too high. Believable? Believable? No, sir. Definitely not. Now it's an exception. If it is an exception that you have identified, document and keep it. Clear? So keeping this in mind, it is not a formula that everywhere exceptions will be identified. Some case it will be identified, some it will not be identified. So if it is a rare exception, documentation is important. If it is a general, no problem. You need not maintain. Again, it's a call that an auditor has to take. Next, need to document a conclusion which is not readily determinable from the documentation. So documentations are there, but my conclusion is based on calculations. That calculation you should maintain as a documentation. Imagine invoice 1 and invoice 2 is there and I file it in the document. Somebody who reads invoice 1 and invoice 2 will not understand that. Because I have calculated the data considering both invoice 1 and invoice 2. In the exam, directly go and accounts purchase consideration. Just calculate in your calculator and put the purchase consideration in the answer sheet. Will you get marks for that? No, you have to explain it. How did you reach there? That how process is very important and that should be documented. Then methodology and tools used. For example, in sampling we have a technique called as random sampling, simple random and stratified random sampling. Or structural modeling is there where we use linear regression methodologies. Now I need to understand what methods I have used. Now Naveen should understand what Karthik sir has used. In sampling, random sampling. Okay, how did you pick random? Did I use a random number generator or did I use random number tables? How did I pick randomly? So methodology and tools. Tools is nothing but the channels which help you in achieving that methods. Clear? Which formula you have used? Many formulas are there. Which formula you have used that way? So these are the 7 factors that will affect your documentation extent, form, content and extent. What type, what should be there, and extent means how much must be there. Then preparation of documentation. This was asked in the exam as few examples given. Clear? whenever we want to ask you easy questions, we'll not ask you easy questions, but we'll make it difficult. Answer are easy. You know how? In one of the exams, point number C and point number D was the answer for 3 marks. Then they are also asked examples. Give few examples of audit documentation. Totally they have asked us as a question. Very good question. For I consider that as a wonderful question for audit documentation, because here we can't play much of games here. So whatever games you have to play, case based I can play here. Chapter 2, 90% of the time direct questions. Chapter 2, 90% of the time direct questions. Clear? Here I can play around the case, and lot of times in the new syllabus, frequency, here chapter 6 case based. Clear? Majority case based, minority is direct. Okay? Prepare the documentation on a timely basis. We all know within what time I should prepare documentation. 60 days. From where? Audit report date. Retention period is how much? 7 years from the date of audit report. Okay. But remember guys, this is one more strap. There are 2 reports I give. In case of listed companies and companies, I give 2 reports. One is report on standalone financial statements and one is report on consolidated financial statements. Generally, both reports will be on the same day, but if the dates are different, then 7 years for this should be calculated different, 7 years for this should be calculated different. But 90% of the time for listed companies, both dates will be same. Because I will not give SFS report first and then give CFS. Both are interconnected for me. I will finish it off in one shot only. But remember that CFS is what we call as group audit. Clear? For group audit, we are giving a different report. That date will be different and this date can be different. In that case, you have to calculate 2 different dates. 60 days also will change, 7 years also will change. Be careful for that trap in the exam. Documentation prepared after the work is likely to be less accurate than documentation prepared at the time of work. Meaning, whenever, now for example, if I say this is an important point, point number 4 is important point. Now, technically, I told it is important point. You noted right away. What if I say it is not important? That's the point. When I told important, right now only you made a note. Why? You feel when sir is telling only if I noted, it is more effective than if I wait for the class to get over and later I note it. You noted it down. No. I gave an example. You noted right away. So you feel that is more efficient. It is important only. Okay, don't note it. Just to give you a demo, I did that. Okay. Next, audit file and its assembly. Now we have done this. Same 6 days and same 7 years retention, but the catch, the crisp of this particular topic is point number 6. The crispy part is point number 6. Admin changes can be made. Once you finish those 60 days, during that 60 days, you can do whatever you want. But once you finish off that, then you are not supposed to delete any document, add any document. Logic. I will ask you one case-based question, think and answer. Once you give a report, technically, when do you give a report? After obtaining evidence or before obtaining evidence? After obtaining SAI. So, SAI date cannot be beyond report date. Agreed? Which means once report is given, that means my work is over. After that, I can't add any new evidence. Clear? I can't perform any new procedures. I can't take any new judgment. Then what is allowed, sir? These 4 things are allowed. Clear? On this again, case-based question was asked. Clear? What is allowed? Number 1, you can delete or discard superseded documents. What is superseded documents? Overriding documents, duplicate documents. Imagine you got a certificate, manager certificate only. 2 certificates you got. Okay? One you got on 25th March, one you got on 31st March. Clear? Which one will you keep? 31st March. What about 25th March? I can discard. But if it is already kept in the file, I can keep the 31st, I can remove the 25th and discard because it is a duplicate document and one superseding the other. Clear? So if there is a superior document, keep that superior document and leave the inferior document. In exam, what they asked was, draft inventory sheet, should I keep a documentation or final inventory sheet? Draft is trial. Draft should I keep or final should I keep? Final I should keep. So that means draft should be ignored. Understood? Clear? Okay. Sorting, collating, cross-referencing working papers. Sir, documentation is put. but it is a mess, sir. Can I sort it date wise? Yes. Collate means what? Paper size wise I will document, sir. Some are A4, some are A3, some are A5. I'm just collating the document, arranging the documents. Can I do that? Yes, sir. Cross-referencing working papers, meaning putting stapler to 2-3 papers together and then filing. Can I do it? These all are clerical job. You think this is what you're studying CA for this, sir? Which document, which paper size and all should come first and all. No. That's why it's called administrative changes. Here, you cannot put more procedures, new evidence and all. Not allowed. Signing off on completion checklist with respect to assembly process. Signing off means just an admin procedure where you sign and say completion is done. That you can do after 6 days also, no problem. Clear? Then, documenting evidence. Now, this is classic. Documenting evidence at the monitor, it seems, sorry, it is auditor. Typo. It is that the auditor has already obtained and discussed and agreed with the engagement team before the report date. Meaning, before the report date, let's say 30th June is the report date. Before the report date, I have put the procedures. Clear? I have yet to receive the evidence. I have checked it. On the system, I have checked. Printout I did not get. Clear? I spoke to the team. Conclusion done. Report is given. But printout I did not get. Printout I got after that assembly. Can I put that in the assembly file now? This is the case. I repeat the case. 30th 6 is the report date. Okay. Before 30th 6, I wanted to check some documentation. Client showed me the documentation on the system. I saw the system. I saw the documentation. I am satisfied with the evidence. I went and spoke to the team, engagement team. I said, I have got Sai, finish of the audit. So the team finished the audit, 30th 6, I signed the report. But the evidence is not in my hand, but I checked the evidence. Clear? So I obtained Sai. The printout I got was after 6 days of audit report. Okay. The management told system had some error. We will give it to you later. They gave. That physical copy which I got, can I put it after 6 days in the file? Yes. Why? Is it a new evidence? No. Is it an old evidence? Yes. Just that the existence, physical existence I got later. That is fine. This can be asked in the exam to confuse you. Clear? How they'll confuse? Nice storyline they'll give. You just have to focus on 3 things. When was audit completed? When did you obtain the evidence to finish off the audit? And when did the physical existence of the evidence came into the picture? Got it? Understood? Okay. Next, changes may be made to the documentation during the final assembly, but after the assembly, you cannot discard or dispose before the end of retention period. And what is the retention period? 7 years. Clear? Next. Documentation of significant matters and professional judgment. Now, judgment itself is subjective. Clear? Everyone has a different way of judging. It depends from facts and circumstances. Now, the important factor we have to understand is what is the extent of judgment CA has taken while performing the work. Now, imagine this topic was not there. Naveen would not be able to identify how did I tell provision is reasonable of my client. He said 10%, but he considered 12% this year. Karthik sir said reasonable. On what basis? He will be clueless. Now that I have to document and keep so that next time Naveen understand how I have taken the judgment. For that, documentation is very important, and this is actually critical because this can be important from my side, need not be important from my side. What are the matters? So standard says, I will help you out, Karthik. What are the matters that give rise to significant risk? Meaning, how can you decide this matter is significant and I should document it? If I had not told these 3 points, I would have never known about it. So how will I know? Number 1, result of procedures which indicates that FS are materially misstated. You perform a procedure, you get a result. That result shows financial statements may be materially misstated. That result you document and keep. Example, I made an enquiry with related party for payments. Now I got to know that the RP is nothing but the father of the director. Close relative. Yes. Now is it indicating that financial statements could be materially misstated? Provided it is not at arm's length price. If it is at arm's length price, then there is no risk. Imagine the product is sold to outsiders at 100 rupee per kilo and it is sold to a father's business at 60 rupees per kilo. Arm's length or non-arm's length? Non-arm's length. So when I did my procedure and asked, I got to know it is a non-arm's length price contract. Should I record this evidence result and keep? Yes, because it indicates that FS could be materially. The word is could be. It's not it will be. But it is a significant matter. Next time, my team or Naveen, when he sees, he will know that there is an RPT between company and company director's father. So next time he can put more attention in that area. Number two, need to revise the risk. See, risk is actually put even before I start the audit. Clear? Risk I will judge even before I start the audit. While I am doing the audit, I need to revise my risk. As and when I go ahead, I should revise my risk. For example, did you know the risk before coming into chart accountancy course? Yes. Did you revise the risk after coming to the course? Yes. Of course, yes. Clear? Right? So when you came to the course, you would have got to know some sort of risk. Right? Now they will tell you, yeah, foundation is okay, inter is little difficult, final is little more difficult. But more details when you get when you came to course. Clear? I always tell students come and tell initially that, sir, we will write both groups. Clear? First subject when they start of CA intermediate, fully motivated. Clear? Both groups I will score rank. Good. But I will not trust that. You know why? You have not seen all subjects. Clear? When OG comes, right? When accounts got over, you are happy with accounts. When law starts, no problem because law has a framework. When tax comes, no. Tax will give a little more fear. Clear? Then comes group 2. When costing comes, practical subject, 50-50 is there. Then comes Muttupandi in form of audit. Clear? When he comes, sir, it's okay. We will write one group, then we'll finish off one group, then we'll write another group. Clear? Now, didn't you assess the risk? Initially, you thought both groups are not risky. Later on, you assessed that both groups are risky. Then you evaluated that risk and came down to one group. That is called revision of risk. Clear? That's called what? Revision of risk. Same logic. I keep a risk in mind and I start my audit. I thought management is good boy. I got on this present criminal activities in between the audit. I need to revise my risk. Clear? He is giving fake documents. Risk will increase. Revision of risk. So those documentation you should keep. What made you give the feeling that risk is more here? That you have to document. Understood? Clear? Right. Then circumstances that causes the auditor significant difficulty in applying necessary procedures. Example. Management delaying information. See, tell me one thing. One logic. Answer this question. Between sales invoice and purchase invoice, which is internal evidence and external evidence, or internal document and external document? Purchase is internal document. Sales is no, ulta. Do the ulta. Now you have to simple. I'll give you one formula to remember this. Point of generation tells me the source. Sales invoice, where did it generate? From management side or from buyer side? Management side. So who can tweak that? Management. Therefore, it is internal evidence for us. Point of generation is internal. Purchase, external evidence for us. Clear? So we can go and ask purchase the creditor there. How much did you sell to this guy? Clear? Now in this case, imagine I'm asking sales invoice. Give me sales files. Management is like, sir, that actually sales file is outside source, sir. We are asking. Asking whom? You are the one who generated that. Original copy you should have. Or rather duplicate copy you should have. Now if management is not giving me required information, it is a circumstance which is making me difficult to do the audit. When I document and keep it in the file, Naveen can get to know that next year even he'll face the same situation. Clear? Right? That is the logic of documentation. Findings that could result in modification of your opinion. What made you modify the opinion? So here I will write reasons for modification or conclusions for modifications. Why did you modify the opinion? If these was not there, no, simple logic. If these three things were not there, Naveen should have contacted me and asked, sir, can you please tell me in this audit what all difficulties you faced? Now, do you think it is possible to talk face to face and give all the information? Not possible. That's why documentation we are maintaining. Clear? This can be asked for 3 marks. Careful. Next, documentation of professional judgment. Sir, this is the difficult part for a CA. Basically, judgment is what I think and I should document what I thought. Clear? Judgment is what? Thinking. Here I should document what I thought. What if this concept was not there? If this concept was not there, no, then Naveen would be confused. Because opinion is professional judgment. Misstatement is professional judgment. Pervasiveness is professional judgment. Clear? Everything is what is important, what is not important. Everything is professional judgment. So the next CA will never understand what to do. My team next year, they don't know what to do. Totally now everyone is dependent on Karthik sir. So I have to be there every year, which is not practically possible. Clear? So in that case, when you document, what should you document? 3 things you should document. The reasoning for the conclusion when a factor or information is important. In simple words, some of the standards or law tells clearly that auditor should consider certain information which is important according to him. Now who says this? Law only says this. That means law is not telling me anything. Law just says do what you feel like. Now I will do what I feel like. Clear? Naveen will do what he feels like. Hari will do what he feels like. Now who will read that documentation? Next auditor should read. Peer review when it comes. So many inspection can happen. They will never know if I don't document. So I should write which information is important for me. Because in chapter 2 there is one concept called planning, strategy and program. While putting up strategy, there is one point which they say auditor should consider those factors which are significant in team's effort. Now that factor, which factor is important? I have considered the factor, but where is it written? So I have to maintain a documentation of it according to me, which information is important, which factors are important. When I document and keep it, next time whoever see, they'll know that last time sir took this matter as important, we will also take this matter as important. Understood? Number 2, basis for conclusion on reasonableness of subjective judgment. That is management judgment. Management takes multiple judgments, whether it is reasonable or not. Remember, judgment cannot be accurate. Judgment cannot be accurate because judgment has assumptions in place and assumptions cannot be accurate. So it can only be reasonable keeping the situation in the mind. Last year provision was 10%. This year provision I put 15% because this year my debtors increased and my debtors risk also increased. Most of my debtors filed for bankruptcy. Can I increase my provision? Yes, definitely. Last year 90% of my debtors were good. Therefore I decreased the provision. Is it reasonable to increase? The answer is yes. Why? Because the circumstances are such that my debtors are in a bad place. Therefore I should increase my provision. Got it? Yes. Okay, so basis for telling whether the judgment was reasonable or not. Third, conclusion on the authenticity of the document. Whether a document is authentic or not. But sir, I am not an expert, no? Am I an expert of authenticity of documentations? No, but that is the reason why you have to document. If you are an expert, no, we would never ask you to document because we'll always assume that you are an expert. But here, imagine management gave one document to you. You believed it to be true. Clear? Then you started auditing. Then you got to know that documentation is false. And that time you performed more work. Now after performance of more work, you concluded that documentation is original or duplicate. Document that conclusion. How did you find out it is fake or original? Clear? In normal class, I had given one example for you where a hotel audit, when a particular bill was flagged as a fake bill, vegetable bill, if you remember, 5,000 coconuts example bill I had given of one of the restaurant. Yes, where the bill had date, party, amount, quantity, price, rupees in words, signature, everything was there, and one of the senior told what? It's a fake invoice. Then they went and searched more about it. Then he concluded that it is a fake invoice. Now, how will the next team know about it? If you don't document, how will the next team know about it? They will never know. So when you document and keep the reasons, the next team will understand it. Okay, that means every year these people are charging this. This invoice we have to be careful. Clear? Next, completion memorandum. Completion memorandum is like the summary notes. Completion memorandum is like summary notes where you may consider it helpful to prepare and retain as a part of documentation. What it should have? Two things. What are the important matters you have identified and how did you solve that? How it was addressed means how did you solve it? Specifically for large and complex audit. For small audits, you need not maintain a summary notes. Clear? The preparation of such summary, it will help in consideration of significant matters. You should consider if there is any individual essay objective is unattainable. Unattainable means I am not able to achieve. That also you have to document. Why was I not able to achieve? So basically in summary, 4 points you have to maintain. Number one, what are the matters? How did you solve? Applicable for what specifically? Large and complex audit. And you have to also document how did you not obtain certain objective. Okay. May 25 recently 4-mark question was asked on this. What is the question? Explain the meaning and significance of completion memorandum. And this is a combination of two, assembly as well as memorandum. Team member Y completed the assembly of final audit file in March 2025 and handed it over to CAP. Was team member Y correct in his approach? Audit report is important. I told you, they will give you a story. You have to only see one thing. When was audit completed? When was it completed? August 20th, 2024. Clear? Because they clearly told the report was issued on August 20th. That means that is the report date for us. So from 20th August, 60 days you count. When is it? In August, 31 days are there. 31 minus 20, 11. Then September, 30. October, 19 now. Correct, no? Because 60 days we want. 11 days we got in the month of August. 30 days we got in the month of September. 30 plus 11 is 41. 60 minus 41 is 19. So in the next month we have 19 days. So 19th October, on or before 19th October, you should have finished your assembly. When did this fellow finish? Too early. Clear? He finished next year, March 2025. Is it valid? No, sir. This is totally invalid. Okay. For that 2 marks, and to write the meaning of memorandum, 2 marks. Clear? Genuinely, if you see these questions, no, I'll tell you, my request for you, don't consider May as a base. May 25 paper, don't keep it as a base. Even May 24, you do it as an additional material, but don't rely and tell exam question will be like this only. This is one particular attempt where I have seen students going and writing and coming and still scoring 40. Clear? But students will have a mindset that question will be like this only, and September they showed. Clear? So don't believe just like that. Don't keep as a basis. These are all your additional material to solve questions. That's it. Ownership. Who is the owner? Same topic repeated. Who is the owner? Auditor is the owner. Can he make the copies available to outsiders? Yes, only on 3 situations. Number 1, client only says. Clear? If client has given authorization, no problem. Number 1. Number 2, if law asks him to do it. Number 3, there is a professional duty. Remember 3 things. Number 1, client's permission. 2 things I want to discuss here. Number 2, law. Number 3, professional duty. Now, listen. This and documentation, there is a combination. I am talking about confidential information. Okay. If you want to disclose confidential information, there are 3 ways to disclose it. Client only should authorize, law should tell you, or there is a duty. But with respect to my documentation, I need not have these 3. My documentation is totally whose call? Auditor's discretion. But if I am sharing it, I need to be aware that if I am sharing, my quality should not be compromised. My quality should not be compromised. Now, why am I adding these two here? Confidentiality we saw in chapter number 11. Why are we talking about it here? Because in my documentation, there could be confidential information. I repeat, in my documentation, there could be two. My workings, confidential information of the client. My working, if I have to give, discretion is totally mine. But if I want to give confidential information to outsiders, then I have to see three things. Did my client authorize me? If not, is the law asking me to do it? If not, is there a duty as a professional to do it? If these three things are not there, then in my documentation, confidential information I can't give, but my workings, if I want, I can give. Clear? This I am combining chapter 6, chapter 1, chapter 11. A case I can create and ask. Clear? So to sum it up, I will give one more time a revision here. If my documentation is my property only, can I give it? Yes, I can give it. But in my documentation, I need to first see two things. Is there any confidential information of the client? If there is a confidential information of the client, even if I want, I can't give, provided there are three conditions. Number one, client has authorized. Number two, law has asked me. Number three, there is a professional duty. But confidential information is separate. My workings are there. Can I give this workings? It is totally whose call? My call. Can a client force me to give that? No. Understood? Clear? Be careful in this particular area. Right. Let's solve few questions here. Messrs. PK and Company, Chartered Accountants are stat auditors of JC Limited. CA Tarun, partner of Messrs. PK and Company, was entrusted to supervise and verify inventory items as on 31/3/2024. During the process of verification, a large chunk of draft inventory sheets were accumulated. I am highlighting one thing here. Draft inventory sheets. And then a final inventory sheet was prepared. Forget about the requirement. Which one I should file? Draft or final? Final. He kept all these drafts and the final sheet in the file. Is the approach correct? Yes, sir. Is the approach correct? He kept both. He kept all the drafts also, final also. Which supersedes what? Final supersedes draft. So which one I should maintain? Final I should maintain. Then they have told which papers or document may not be included. That administrative changes are there, no? Clear? Those. Draft, if you have original document versus duplicate document, keep the original document. Those conceptually you have to write here. Okay? Next. Rajni, a CA student, has understood that SA 230 requires CA to prepare documentation on a timely basis. While reading about SQC1, she notices that time limit for completion is 60 days after the date of audit report. She finds it to be puzzling, unable to comprehend, seeks your guidance and guidance. Simple question. Your retention and filing. Clear? Assembly question this is. Meaning of completion memorandum, straightforward theory question. Fourth one also straightforward question only. Explain stating clearly the examples of significant matters. 3 examples. 3 points. Results, risks and circumstances. This one. Here. Where is it? Here. See. Results, circumstances and findings. These are the examples you can give. Next. CA report. Directly go to the requirements. Discuss the issues involved in documentation and assembling the file. So basically, which concept they are asking? Assembly of audit file and documentation part. That is what to be filed, what not to be filed. CA report completed the audit of listed company. The report was issued on 17th July. So audit report date is 17th July. However, not properly organized the audit working papers, including records of discussions with the management. More than 6 months after issuing, received a letter from the regulator in connection with the audit. In a hurry, he quickly assembled the file, adding some papers he thought were necessary, but he used current date on this newly added documentation. He then sent the file to the regulator. Mistake? What did he do? He added new documents. Clear? That is after 6 months. And then he put current date. Yes. What is the due date for assembling? 60 days from audit report date. Number 1. Number 2. After that, can I add anything new? No. Which new I can't add? Any new procedure, new evidence and all I cannot have. So he cannot add whatever he wants. He should have finished within 60 days and administrative changes are allowed after 60 days also. Clear? That point you are supposed to write. CA has prepared documentation of an entity describing nature, timing, and extent of procedures performed during the course of audit. In documenting the nature, timing, and extent, which matters shall be recorded. Which one is this? Remember, I told you A, B, C, D. In that point number B, you're supposed to write 3 points. Clear? He is also of the view that such documentation alone, as described above, meets requirements of standard. Comment upon validity. I only told you this was asked in RTP May. This point. What type of items I tested, who performed the work, who reviewed the work, etc. Next, CA Shilpi, the engagement partner at MN Associates, is assigned the order of following 2 companies. Z Limited, small family run business with straightforward operations, minimal internal controls and low transaction volume. TED Limited, large multinational corporation, complex operation, multiple subsidiaries, high transaction volumes. During the audit planning stage, CA Shilpi highlights that form, content and extent must be customized for each client based on specific factors. Discuss those factors. Such a big thing we read now. Directly if I had gone to requirement, discuss the factors on which form, content and extent depends. You would have saved at least 3-4 minutes in reading the question. 7 points. Clear? Tala for a reason points you write. Okay. Next. Thakur and Co. Chartered accountants were conducting an audit of an LLP. They have verified the receivables and concluded that all receivables are genuine and recoverable. However, before the final completion of audit, the auditors came to know of severe financial crisis of one of the receivables, Messrs. Raj Enterprises, whose outstanding account balance was material to the overall receivable figure as on the date of financial statements. CA Thakur had discussions with the appropriate level of management to address the issue, and the management finally agreed to make provision for the same as suggested by the auditor. You are required to ensure how auditor can fulfill the documentation part of this matter. Mention any 4 different examples. I consider this as a very good question as of now for documentation part. Here you have to write point number C and point number D of form, content and extent. What is that point number C and point number D? This is the point. Document the discussions of significant matters with management, TCWG, what type of matters you have discussed, when and with whom. Point number D, if you have found any inconsistent matter, how did you resolve it? Then you have to write 4 examples here. Any 4 examples you can write. Now the answer doesn't end there. Clear? Here they should also write what he should document. You have given an overview of point number C and D. Then specifically you should say they have given a case. That's why. So you have to write, we spoke to management with respect to overall figures. He has to document what is the final conclusion the management has reached, what provision CA has suggested, what is the because it is receivable, no? They are saying whose outstanding was material, therefore provision must be created. So you should document what is the provision CA has told, what is the provision management has accepted, clear, and what is the end conclusion of provision that we have recorded in the financial statements, and what conclusions I have, what are the matters that I have spoken with respect to management. My suggestion would be directly today itself or whenever you are watching this marathon, go to September 25 and read the suggested answers of this. Clear? For me, as of now, documentation case with respect to those, this is a very good question. Okay, that is your chapter number 6. So today's target we kept what? 1, 11, 6, 2 and Karo. In that we are done with 3. We are left with 2 and Karo. Clear? We'll take a lunch break, right? And then we will continue. Okay, sir, could you give me more clarity on regulatory requirement versus professional duty? How is both different? Regulatory requirement means SEBI clearly says you have to report to me. Now that is regulatory requirement, not law. Law comes Companies Act and other things. Now regulatory means the regulator, the one RBI, SEBI, etc. They ask you to report. That is regulatory requirement. Professional duty comes under your ethics and other part. So as an ethical person under professional ethics, are you supposed to go and report? In income tax, is it your duty? They have not told, but is it your duty to go and report? Section number 143.12 clearly law has put duty on you saying you have to go and give, because the section name only is powers and duties of auditors. So as an auditor, you have a duty to go and report to the central government if the fraud exceeds 1 crore or equal to 1 crore. Clear? That is the difference. Break till 2 o'clock. Yes, next, let's start with chapter number 2. Audit strategy, planning and program. Here you can expect a 10-mark question. Okay. Generally a direct question. Average 10 marks you can expect. Most of the attempts, this chapter is given around 8 to 10 marks for sure, including your MCQs. And 90% of the time, direct questions. Even though they will give you a lengthy story, at the end of the day, they want to ask only what they want to ask. Okay. Now, in this, we are going to talk about 3 concepts. One is your strategy concept. What is strategy? One is your planning, and one is your program. Now, among the 3 concepts, which comes first? Always strategy comes first. Okay. Keeping strategy as a base, we prepare a plan. And we detail the plan in program. So among these, which is the most detailed one is program. The least detailed one is strategy. So we have strategy, we have planning, we have program. Now, what is the difference between these 3, sir, and why do we require these 3? See, when we put up a strategy, we don't specifically say what exactly we want. Here we figure out what we are supposed to do. Our objectives, goals and all will be set here. So strategy actually helps you in setting 3 things and in helping 4 things. It actually sets the scope, timing and direction of what? Of audit. So it helps you in defining the boundary where I am supposed to work around, timing, when am I supposed to work, and direction, in which area I am supposed to work. That's it. Specifically, it will not tell you, it will give you a direction basically. And this particular strategy is what is going to help you. I told it sets 3 things. It helps in development of audit plan. Now, this is a concept of strategy which can be asked in exam. They have asked before also. Clear? So, audit strategy will help you in setting scope, timing and direction of audit, plus it will help you in development of audit plan. Now, what does plan help you in then? Plan gives you more clarity about nature, timing and extent of procedures. So if you see, in strategy, we will never speak about procedures. We are just talking about how we are supposed to go about it. But in case of plan, it gives us exact procedure, what type of procedure I should put, when am I supposed to put, and how much am I supposed to put. Now, program is even more detailed, where this audit procedure, we are going to give an explanation about what type of questions we are supposed to ask, what type of instructions we are supposed to give to our assistants. Clear? Which area for sales, what type of questions we have to ask, for purchases, what type of questions we have to ask. Area wise, proper detailed instruction, comprehensive instruction is given in form of program, right? So strategy is just going to give you a direction. Plan is going to tell you what type of procedures you are going to put, and program exactly gives you the roadmap. Exactly the roadmap. Clear? So program cannot be said we will be just doing on an average. No, it has to be according to the department. Okay. Now this each for 2 marks you can ask instead of giving you a 1 4-mark question. In MCQ they can ask strategy will help you in setting dash scope, timing and direction of the plan, helps you in development of audit plan. Number 1. Audit plan helps you in what? Setting up the nature, timing and extent of audit procedures. And program gives you what? In detail about audit procedures. Okay. Now, although your institute starts with benefits of audit plan, they go back to the strategy once we start planning. Okay. Remember, strategy comes first, then only plan comes. Now the next concept I want to ask, if strategy changes, should my plan change? Yes. If my plan changes, should the strategy change? Yes. Here is where students will go wrong. Students will think that if strategy changes, plan will change, but not vice versa, sir. Both are interconnected. Clear? Both are interconnected. If your strategy changes, plan will change. If your plan changes, strategy also will change, because it is an interconnected concept. And if these things change, obviously program will automatically change. It's a consequent. Okay, what are the benefits of audit planning, sir? If we plan properly, we will be able to devote enough time on important areas. For example, if you are planning, when you are putting up a timetable, your timetable focuses on important areas. It will not focus on unimportant areas. That is called planning. Now, let's say, for example, you have, now, first of all, tell me, do we have enough time in the world to finish audit? Or do we have restricted time? We have restricted time. Now you have, let's say, 1 month for the exams, right? Now in this 1 month, you're supposed to prepare. In 1 month, can you prepare 100% extensive by doing all possible questions? Not possible. Therefore, planning is required. Now, when you're putting up a plan, you will be focusing only on important areas. Imagine a student was sleeping nicely 12 hours a day till now. Clear? Now, 1 month before the exam, your timetable when you're putting, will you sleep for 12 hours in a day? No, it will not let you sleep also, no. Clear? You will have to cut down on your sleep. So you're focusing on important area, not to sleep more. Clear? Study more, important areas. So when you put up a plan, I will exactly know where is the important area and where am I supposed to focus. So number one, devote. Number two, identification and resolution of potential problems on a timely basis. I am not saying whatever is going through now, whatever can happen also I will be able to solve because of my plan. When you put up a timetable, same example I'll take. When you put up a timetable, students don't even consider contingencies, and that's where they go wrong. When you put up a timetable, you have to consider contingencies, sickness, events, any function is there in the house. All these contingencies, when you're considering, these all are potential problems. When potential problems you're resolving now only, you're prepared for those problems today. If the problems don't happen, good for me. But if the problem happens, I'll be able to resolve it also on a timely basis. Third, systematic organizing and managing the audit, as I have limited resources. Because of my limited resources, I need to organize my audit as well as manage my audit. I have limited number of people, I have limited number of time, and with all those things, managing becomes very, very important. Imagine you have 5 listed company clients and you have limited number of people. That is exactly why if you see big fours and all, always will take people, because they have so much of work, they require so much of resources. Clear? When I have so much of work, I need to put up a right plan, because everyone gets only 24 hours in a day, right? Then helps in selection of engagement team members with appropriate level of capabilities and competence to respond to the anticipated risk. So I need right type of people in my team, and how do I choose? Based on my plan. So when I put up a plan, I exactly know for this type of client, I need an experienced CA or I need an experienced staff. For this type of audit, I don't require more experienced people. So allocation becomes more easier. Fifth one, DRS of work, directing, reviewing and supervising of team's work. So planning will help. Everything is in written form. So I get to know where my article or where my staff is working. I can direct him, boss, you're putting wrong efforts in wrong area. Clear? You're putting right efforts in wrong area. Put it in the correct area. So I can direct him. He's putting efforts, but where he should put that, based on the plan, I can tell. Helps in coordination of work done. What is coordination of work done? Integration between work, meaning connection between work. For example, if somebody is doing an audit of sales and one person is doing audit of taxation, now their work is interconnected, no? Yes or no? Sales, you charge GST, and here it's an output tax, output liability. Now the person who's auditing taxation also, he should be coordinated with the sales department, the one who's auditing there. So when I put up a plan, I can tell you both do sales audit together, you also do GST audit together, so that you can merge both the liability here and you can check whether it is properly deposited or not. Clear? Then these 6 points can be asked multiple times. I have asked, okay, is planning a continuous process? Is it a one-time process or a continuous process? It's a continuous process. Why continuous process? Because there is one more word in exam you have to see, iterative. Iterative means repetitive. It keeps on changing because of circumstances changes. Clear? Information will change, circumstance will change, and throughout the year, you'll be planning for an audit. Clear? It begins after completion of previous audit and continues till the end of current audit, which means it's a continuous cycle. It keeps on happening, keeps on happening, keeps on happening. Whenever you're planning, you need to consider 5 points here. Number 1, identification and assessment of risk of material misstatement. And under that, you have to consider analytical procedure, understanding the framework and how management is following that framework. Why? ROMM is whose responsibility? Management's responsibility. So who should ensure the risk is reduced? Management should ensure. If they are not following AFRF, risk automatically increases. Determining materiality. What is important? There only we can plan. What is not important? I need not focus there. Then, experts involvement. Do we require expert? If yes, when and at what particular stage of audit we require? Example, if I am doing insurance audit, yes, insurance also will have income, expense, asset, liability. But do I need actuary now or do I need actuary at a later stage when I'm going and checking provision for claims? Now only if I call him, what is a point? So when do I actually have to call an expert? Does he require in my particular audit? If it is not required, then I can manage with my own resources. If it is required, then I need to involve him. And when am I supposed to involve him? That also you have to plan. Now, for example, in most of the audits, your boss will never come on day 1. Clear? Only the senior and the staff will handle it. But your boss will come at the end of the audit for finalization stage. Clear? That is where we say experts involvement, where he should be involved. Performing other risk assessment procedure, example, inquiry. With whom we have to inquire. Then, inspection. What type of documentation we have to inspect. Then, analytical procedure is already covered. Observation. Inventory count. Inventory count we have to observe. So, whether inventory count has been observed or not. Yes, if yes, when are we supposed to observe the inventory count? Even that has to be planned. You know why? Does inventory count happen every day? Inventory count doesn't happen every day. Management will fix a date. On that date, I should be there. Now, that also you have to plan. Randomly, you can't go. Okay. Point number 4, engagement partner and other key members of the team shall be involved in planning the audit, including planning and participating in the discussion among team members. This is important. Engagement partner and other key members of the team, not everyone. Sir, you joined articleship today. Tomorrow there is an audit. Will they take your opinion as to how we should go about audit? No. Why? What opinion you will give? How do we go about audit? We'll go. You don't know anything about it. No. So we need experts involvement or senior member, senior staff, senior article. Their opinion we should take. Why their opinion we should take? Knowledge and experience has no substitute. Clear? So when we involve their knowledge, when we involve their experience, automatically our plan will be better. You may decide to discuss elements of planning with the management to facilitate the conduct and management of engagement. This is a very good case I can generate out of this. Now you tell me here, should I discuss my plan with management? Should I discuss my plan with management? The question is, I should not discuss my plan with management. Then what is this point telling, sir? This point says elements of planning, not the plan. There's a difference. Elements of plan and plan, there's a difference. For example, you are my client. Okay. If I tell you what exactly I am doing, won't you be prepared for that? Yes. Therefore, what am I supposed to do? I'm not supposed to tell you what exactly is my plan. I'm just telling you, 24th, I'm coming for audit. That's it. You make the arrangements for it. Because if I don't tell and come, no, specifically standard says for facilitating the conduct and management. When do we conduct the audit? For that you tell. I should tell the client, see, tomorrow we are doing purchases, get the file. Which invoice I'm checking, how am I going to check, which creditor I'm going to ask confirmation, those things I should not share. Because document who has, management has, information who has, management has, therefore who should give me the information? Them only. Now in some of the client's case, no, the factory will be somewhere else, admin office will be somewhere else. Right now, for example, imagine I come to Coimbatore for audit, ArivuPro's audit. Do we have accounts department here? No. Now if I, without telling if I come here, what will I do here? Nothing. Clear? Absolutely nothing I will be doing. Now imagine I call ArivuPro and say, what here? Nothing is there. So you should have told me that you are going for an audit there. I would have sent books of accounts. No, why should I tell you my plan? Don't tell the details of the plan, but at least tell when you're starting the audit. Clear? Starting the audit, which files you want, what information you want. When you tell the management only, you can conduct the audit. Otherwise, it will be very vague and very difficult for you to start your audit. Imagine you're going with 10 people to the client place. There is no books at all. Clear? So that's why you have to notify the client as to we are coming. Please keep the information ready. Don't disclose your exact plan. Okay. Then planning process. In that elements of planning, two things are there: preliminary engagement activities and planning activities. Now I am doing the marathon in the same order of concept. Clear? It is not a random order, it is a conceptual order, because what is the first level of, what is the first element here? Preliminary engagement activities. This is straight away coming from chapter number 11. Clear? Technically, if you see, this is chapter 11 points only regarding continuance, acceptance and continuance of client engagement. SQC 1 point. Clear? Next, if you see, evaluating compliance with ethical requirements including independence. Again, chapter number 11 point. Next, if you see, establishing terms of engagement. Again, chapter number 11 point. You go with chapter 1, 2, 3, it will be a duplication and a student will not know. At the end of the day, one opinion will come of the subject. Everything is same. Everything is not same. Clear? Now, what we did in chapter 11 is we decided whether we should accept the client or not. Once we accept the client only, we put up a plan. You never put up a plan and then you accept the client. Clear? Do you first put up a timetable and then you enroll for CA exam? Then you enroll for CA course? No. First you enroll for CA course, then you enroll for the exam, then you start putting up the timetable. So this is nothing but from chapter 11 a repeated point as to when you are planning, whatever conclusions you have got in chapter number 11 should be considered here. Example, sir. Example. If in chapter number 11 integrity of the client is there, if you got to know that fellow is a fool, that fellow is a fraud, would your plan be more meticulous and detailed? Yes, sir. So it will be more detailed. Once I get to know that integrity is not there, I will still do more and more work on that. Clear? If competence of the client is not there, under planning, I should put a better planning. So chapter 11, whatever you have considered, you have to take it into account here. Number 1, performing procedures with respect to continuance. Technically, it is acceptance and continuance. If you accept the client, here you will plan. If you continue with the client also, here you will plan. Now, what I should consider? Ensure proper procedures have been followed. What procedures we are following here? SQC 1. But technically, it is not SQC 1. It is SA 220. But in SA 220, with respect to acceptance and continuance, what they have told? Follow SQC 1. At the end of the day, ultimately, I will be following what? SQC 1 only. Clear? And conclusions reached in this regard are appropriate. Meaning what? If you accept it, then only planning will come. If you are not accepting, then planning will not come into the picture. Number 2, firm should obtain information considered necessary before accepting an engagement with a new client. Okay? Which matters? Same. Integrity, competence, and compliance with ethical requirements. Here one more thing. Any communication with the X should be considered here. X auditor. Why? Because X can tell you a lot of things which the current is not going to tell you. Clear? Problems about auditors. Yes, information is not giving, sir, he is fraud. Clear? So if he is fraud, then my planning will be little more detailed. Understood? Clear? Communication should be made where there is a change of. No, listen. Point number 4, it will come only if there is a change of auditors. If there are no change of auditors, point number 4 will not come. First 3 points will come. Integrity, competence and capabilities or compliance. ICC, same point of SQC 1. Fourth extra point only if there is a change of auditors. That we have covered in chapter 11 also. We are asking the client the reason. Why did you appoint us and why not the previous CA. Then evaluating ethical requirements including independence. First of all, we have to evaluate compliance, whether now is it ethical principles or ethical requirements? Requirements is what they have given here, which means IPCCO plus independence they are asking. So both should be there. Okay. So first to evaluate compliance with ethical requirements including independence. Remain alert throughout your audit. Why? Sir, independence only day one I should check or what? No. What if my team is so corrupt that in between if the client bribes, this fellow will be, sir, okay, I will not give certain information to my CEO only. So throughout the audit I should have observation skills. I should be inquiring any non-compliance with ethical requirements by whom? By members. My members are articles. You are getting 1,500 per month stipend. Okay. And you will be working for 10 hours in a day. Now the client is offering you 10,000 per month. Will you not be tempted a little at least? Of course, yes. If the client and the way client leads you, you will never know that you are being led by the client. Every day, imagine in the audit, every 1 hour, 1.5 hour, client comes and says, sir, do you want something? We'll get it for you. There is, milkshake is there, fruit juices are there, food you want. You tell me, we'll get it for you. And as an article, what you will do? I have seen what articles do also. Clear? They keep on eating, drinking. What will happen? You are not in a mood of working. Clear? Which means that's a classic way of baiting you into a trap, saying your mind will be switched off because you're sleepy now. Nice AC environment also. Clear? You will sleep off. You feel sleepy. You will not work properly. Therefore, your alertness has been taken away from the work. Clear? And what you will do? We don't have enough time. Right? On sample basis, you will give the report and come. That's what they want. Right? And that is exactly what in some of the cases they will fall for this trap. And during finalization, no, when the CA asks some question, you're gone. Clear? So that's the reason why most of the cases when CA will come and sit in the client's place. So that I know my client better than you know my client. Clear? So my members, it is not about CA. You know why? CA's ethical requirements and all are discussed in chapter 11 only. If I don't have ethical requirements, chapter 2 will not even come into the picture. Because I'll not take up the client. If I have ethical requirements, my member does not have in my team. Then chapter 2, here I have to evaluate members of the team. I should remain alert. Who I in the sense? Engagement partner. Clear? So I should train my people. If somebody comes and says, come and tell me. Clear? When I went to one company which manufactures alcohol. Clear? First day only, morning. 8 o'clock I started audit. 11 o'clock, sir, want something. First day. Clear? And they told, sir, we'll send it to your room also, no problem. You just tell me and we will arrange for it. Clear? Now, this, luckily I don't have the habit, but imagine somebody loves alcohol. Clear? Nice. Then client and article, best friend. Right? So in such cases, my engagement partner should be alert. So our boss came and asked, what was he talking to you? Nothing, sir. He was offering something. Don't you dare say yes. I'm like, even if I say yes, no problem, because I don't have any habit only of that. Clear? Some people will offer you vacation after the audit. Clear? So these things are nothing but spoiling you. Right? So don't let the client become sugar daddy. Okay? You focus on your work. Okay? Then, if matters come to engagement partners, attention, that indicates that members of the engagement team have not complied with ethical requirements, then the partner, can partner fire automatically the article? No. He should talk to the others in the firm, then decide what to do. He can't on his own decide that I will fire the client, nor I will fire the article. I have to take it to the firm. But if you're a proprietor concern, you are the firm. If it's a partnership firm, then you have to talk to the partners. If it is a proprietor, I am the firm. I only can decide. Clear? Form a conclusion on compliance with independence requirement. In that case, what am I supposed to do? Identify and evaluate circumstances or relationship that creates threats. First of all, same logic. After identifying and evaluating, identify the breaches if it is there, report it to the firm. Then try to eliminate the threat. If elimination is not possible, reduce them. If reduction is not possible, withdraw from the engagement and directly go and report to the firm. Clear? Sir, what if I am not able to resolve on my own? Then go to the firm. Ask the partners. See, these are the things that our articles are facing, and the client is offering all these things despite telling no. What to do? Firm will take an action. Okay. Then establishing terms. SA 210 concept. Auditor should send the engagement letter before commencement to help avoid misunderstanding with respect to the audit. This is why I told you one of the September question was not making sense for us. I told you they can't put a clause in the letter because it is me who is sending the letter and I will not allow that to happen. Then planning activities. Now here is where your chapter actually starts. Till now it is just nothing but chapter 11 only coming back. Whenever you are planning, step number 1, like I said, for planning, what is the base? Strategy is the base. So I have to establish overall audit strategy. Here, decision about resources should be taken. Decision about resources should be taken. So when you are establishing overall strategy, it sets what 3 things: scope, timing, direction, and also helps in development of audit plan. Number 1. Number 2, what is the process of establishing strategy? Check what type of resources to deploy. Meaning, if it is a high risk area, I require more experienced member. If it is a complex matter, I require experts. That is why in strategy, I should first put up a strategy in which area who is required. For example, now whenever you are preparing for finals, right, or in inter, any group that you are preparing, in inter generally you might end up taking coaching because you do not know in what subject what is there, right? Now when we go to finals, some people will tell, sir, no problem, FR I can understand because I was there in the department only, I'll do self-study. For AFM I do not know, so for me it is a complex matter, I require an expert faculty. Clear? For this I will take my seniors advice, no problem for me. Now that he's putting a strategy. Clear? So you have to put up a strategy as to in which area who is required. Not every area requires experts. Clear? Then amount of resources. How many people do you want? You said, okay, experienced members you require or experts you require. How many people do you want? Amount means how many or how much, depending upon your entity's audit. Number of team members required for inventory count, extent of review of other auditors' work. That is, example, in case of branch audit, subsidiary audit, associates audit. So in such cases, they have some other CA and I am supposed to read their report before I conclude on my client's work. So how much do you want to go and see? Okay, do you want that fellow to be involved? We can talk to them. Clear? There is one more concept not in your syllabus, just giving you an idea. Now, let's say ArivuPro processes HR, salary and other things. Now, HR salary, an entire HR program, let's say for example, is handled by a third party organization. Okay. So what ArivuPro does? ArivuPro has a salary register. That salary register will be sent to third party organization. They will process the entire salary and make the payment to employees. Now, this is a transaction. Now, I am an auditor of ArivuPro, but HR can I audit? HR expenses can I audit? Yes, but what is ArivuPro's role in HR expense? Just preparing the salary register and giving it to third party. That means the entire software preparation and processing is done by whom? Third party. Which means their software's efficiency I have to check. Their software's effectiveness I am supposed to check. Their systems I am supposed to check. But how will I check that? Just by getting a report. Now either I should tell ArivuPro, go and take their permission. I can only go and do the audit of that particular systems, or ask them to appoint a CA, do audit of that systems, give me a report. Now this, am I not relying on other auditors' work? Yes. So that also should be considered in planning. Are you planning to have another CA's report or not? Third, audit budget in number of hours. How many hours do you want to finish this particular audit? You can never say, I don't know, sir, I will see what to do. You have to give a number of hours. Based on this, only timetable will be prepared. Clear? In practice also, without timetable, we cannot work out. Third, when these resources are to be deployed, first one was what type of resources? Second one was how much you want. And third is when do you want this? Fourth one, how these resources are to be managed, directed, supervised, such as meetings, reviews, etc. Weekly meeting we should have, fortnightly we should have, monthly we should have. When do we need to have this meeting? These are the four things mainly for 4 marks you can ask whenever you're establishing overall strategy. What are the factors you should consider? What are the factors? Number one, what type of resources you want. Number two, how many or how much you want. Number three, when do you want this? And number four, how do I handle them, manage them? Okay. Once that is done, next we will be asking for what are the factors for establishing overall strategy. We got to know where, how, who, when, etc. Now we'll try to understand while putting up a strategy, what are the things we need to decide. There only resources we saw. Clear? Only resources we decided. Keep the resources aside. Now we'll have to put up a strategy. In establishing the strategy, among other consideration. Now which is the other consideration? Resources. Apart from resources, there you decided how many, when, who. Now nature, timing and extent of resources necessary to perform engagement. Step number one, identify characteristic and define the scope. When a client comes, first I should see what is the characteristic of this particular organization, that is my client, and I should draw my scope. Scope means boundary. Then there are many characteristics like what is AFRF for them, what are the type of business segments they are going to have. Example, ArivuPro, they have offline also, offline students, then they have online students, then they have recorded students, then they have ArivuPro 1, right? Then they have, obviously they are in colleges also. So I need to see what are the different business segments they have. ITC, your FUFU, cigarette, clear? Then you have FMCG, agriculture, branding, packaging, hotels. What are the business segments you guys are having? Third, industry specific reporting requirements by industry regulators. Example, SEBI reporting I have to do, RBI reporting I have to do, apart from the normal reporting. This is not applicable for other companies. Clear? Now, for example, in bank audit, those who have done bank audit or those who are going to do bank audit, you'll realize this. You have to give somewhere between 40-50 reports there. Clear? Now, that is specifically RBI's requirement. But general audit, when we go, only one report we give. Independent auditor's report. In bank, apart from independent auditor's report, so many certifications, so many reporting we'll have to do. That is because of whom? Industry regulator. Similarly, SEBI asks for some report that is specifically for listed entities. Then, expected use of evidence obtained in previous audits. Sir, can I use the same evidence as last year, sir? If the information has not changed, then you can use. But if the information is changed, then I cannot use. Clear? So here, very specifically, you have to understand, if everything is as same as last year, then I can use. But if it is different, then I cannot use. Step number one is identification of characteristics and definition of scope. Second, ascertain reporting object. Ask the management, when do you want me to report? How frequently do you want me to report? About what am I supposed to report? If management says, sir, every day evening you tell me how many assets you have done with or how many transactions you have checked. That means everyday reporting my management expects. If management says, every day don't want, sir, weekly you give me, then my plan will be according to that. If management says, weekly don't want, sir, you put it in once in 15 days, then my plan will be according to that. Understood? This helps in what? Timing of the audit. When am I supposed to do what audit? Nature of communication. What type of communication I should do? Now, in one of my client's case, he said, every 15 days you'll have to report to me the status of audit. Now, my plan should be based on that particular reporting objective. If he says once in 15 days I have to give him a status, I should finish off audit also, no? But if he says, no problem, once in 30 days you give me, it's okay if I don't work today. I can plan an off today. But if he says once in 15 days, then I have to work today as well. So according to that, I have to plan. Then some of the instances are timetable, organization of meeting with the management, discussion with the management with respect to what type of reports you want, discussion with the management with respect to status of the work, and expected nature and timing among the team members. Once I talk to management, I need to tell my team, no, work faster guys. They want once in a week report. Therefore, you have to finish the work faster. Now, I did an audit where asset audit is what we call as once in 3 years we have to do the audit. There, when I had to do the audit, I had told my articles. Before that, I had spoken to my senior CA who gave the work. I said, sir, what is the reporting requirements? He's like daily. So daily, how many assets you have finished in that particular factory, you have to give me an update on it. And I will assign one person for that, you have to update him. Now I said, okay. And I told my article, daily you have to sit and report. Clear? So we will do the audit and we'll give you the data. By 6:30 you have to finish the reporting. Now that is a reporting requirement the client is expecting. Clear? Then, what are the factors that are significant in the auditor's judgment should be considered which will contribute to team's effort? Very dangerous question. Because you will never, 4-mark question this is. Easily 4-mark question. So what we should understand here, what are the factors according to my judgment is important which will help in engagement team's effort. Like, for example, volume of transaction. Don't you think if the transaction are voluminous, I need a bigger team? Yes. If the volume is very less, I need a smaller team. It's a factor for me. Number 2, significant industry development. Meaning, if the industry has a lot of amendment, I need my resources to be updated. So I will not take first years and all in my team. This is the factor which will drive my team's effort. I require experienced guy to be there in the team because there is a lot of changes. Third, significant changes in financial reporting framework. Sir, from AS, government has shifted to Ind AS. What type of team I should have? The one who knows Ind AS or the one who knows AS? The one who knows Ind AS. Therefore, that will help my team's effort. Last one, changes in legal environment affecting the entity. Laws have changed. Outside laws have changed. Now, if outside laws have changed, if it is affecting the entity, I have to plan according to that changes as well. And I alone can't work. I need a team also, which gives me that confidence. So these are the 4 factors for 4 marks they can ask. Number 1, volume of transaction. Number 2, industry development. Number 3, FRF changes. Number 4, legal environment. Clear? Then consider the results of preliminary engagement activities or other similar activities. What is preliminary engagement activity? Just know what we did. Example, SQC1 acceptance and continuance, ethical requirements and terms of engagement. Consider that also, the results of that. Meaning, what if in preliminary engagement activity, you got to know that your team is not having ethical requirements. That means my planning will be little different. If client does not have integrity, my planning will be different. If there is a threat to my independence, my planning will be different. That is point number 4. Point number 5, ascertain NTE of resources necessary. Coming straight from strategy. What type of resources you want, when do you want, and how much do you want. Therefore, experts, experienced staff, when do you require? Accordingly, you can put up a plan. So technically, there are 5 points for audit planning. What is the first point? Identification of scope and characteristic for strategy. Sorry, not plan. For establishing strategy, 5 points. Number 1, characteristic and definition of scope. Number 2, reporting objectives. Number 3, important factors. Number 4, PEA, preliminary engagement activities. And number 5, resources NTE, what type of resources I require. These 5 points also can be asked for 4 marks. In Jan 25 mock papers, they are asked 4 marks with respect to this factors. Clear? Before that also, I kept telling it is important. I am definitely expecting in one of the attempts this question can be asked. Clear? May 25 they are asked with respect to these. So this point only, here you can get 4 marks in any of the question. Okay. May 25 what they are asked. You shall take into consideration among the reporting objectives so as to plan the timing of different procedures and also the nature of communication. Give any 4 instances of reporting objectives. Out of these 5, write any 4. Technically, if you see, first or last 3 points are all about discussion. Clear? Second point is about meeting. First point is about timetable. One of any 4 you can write. Now, sir, if they ask 4, should I write 5? No problem. Absolutely no problem. But if they don't say anything, they just say write reporting objective. Should I write only 4? No. There you have to write everything. Okay. Now, development of audit plan. How should I develop audit plan, sir? Number 1, before developing audit plan, understanding the client's business is very important. You don't know what he is doing, what planning you will put. Clear? Without knowing the syllabus, what timetable you will put. So first, understand the client's business. Number 2, that has been asked in the exam. You shall develop the plan to indicate description, that is details. Your plan should have, forget about this point, it's easy. Strategy sets scope, timing and direction. Yes, plan sets what? Nature, timing and of what? Audit. Same thing. NTE of RAP, NTE of FAP, other procedures. Basically, if I put it in nutshell, nature, timing and extent of audit procedure. Audit procedure of 2 types, risk assessment and further audit procedures. Clear? And comes under other procedures, that is outside RAP and further procedures. Very simple. Clear? Relationship between strategy and plan. If one changes, other automatically changes. So strategy sets overall approach. It sets scope, timing and direction. Plan describes how the strategy is going to be implemented. So execution part is addressed in plan. What to be done is addressed in strategy. Okay. Plan is more detailed than strategy, which includes nature, timing and extent of procedures. So if one change happens in strategy, the detailed plan are not necessarily discrete but are closely interrelated. Therefore, changes in one may result in consequential changes to the other. Got it? Clear? Okay. Now, whose responsibility is strategy? Auditor's responsibility is a strategy. So, strategy, plan, everything is whose responsibility? Auditors. So, he should plan sufficiently and he should involve partners and other key members. We have already seen their experience and insights must be taken into consideration. Should I keep the plan same or can I change the plan? I have to change the plan. Why? Because of unexpected events, changes in conditions and evidence obtained can be different and you may need to modify the strategy as well as plan. This is the reason why changes in plan happens. This may also be the case where information differs significantly from the information available, meaning what information is there in the system and what information you have. If there is a difference, plan will automatically change. Example, mismatch of debtor amount. In the books, some other things are there. External confirmation gives me some other evidence, so my plan will change. Planning of supervision, review of team members' work. 4-mark question can be asked here. While planning the direction, supervision and review, what factors I need to consider? 4 factors. SCAR. SCAR or CARS. Any one you can remember. S, size and complexity of the entity. If the entity is very complex, then I need to review more. Area of the audit. If the area is very difficult to understand, my review will be more. Risk. If risk is more, review will be more. Capability and competence of the members. If my member is wonderfully capable, then my review will be less. If he is less capable, my review will be more. Then document everything. Your strategy also you should document, plan also you should document, and changes made also should be documented. Now, strategy means what? Record of key decisions considered. Point number 2, point number 3, and point number 4, MCQ. Or even descriptive for 3 marks. Strategy gives you evidence of decisions taken. Plan gives you evidence of what procedures you have put, and changes gives you evidence of why the changes were made. Repeat after me. Now you tell me, what is strategy giving you evidence of? Decisions taken. Plan, procedures put, changes, reasons for changes. Clear? Tomorrow when investigation happens, we'll get to know suddenly why did you change the plan. What if your interest is there? Clear? Then, these are few examples of documentation in SA 230 we have already seen. Clear? Program. What do you mean by program, sir? List of examination and verification and steps to be applied. Like I said, everything will be there in the program. Each and every detail they will put up as a checklist format by saying, did you check sales invoice? Did you reconcile invoice with the returns? Did you check GST return? Did you check GST website? So list of instructions will be there. Ultimately, I don't have to do anything. As a CA, I do not do anything. I will just prepare that list and I will give it to my staff. Staff will go and ask questions and get it done. So program technically, I will not be doing it. Execution part will not be mine. Some important points. One program not practicable. Why? Different businesses, different organization, different environment. One program is not practicable. Sir, how you study accounts? Do you study audit in that manner? The answer is no. How you study audit? You study accounts in this manner? No. Different subject requires different approach. Same logic. Different clients require different programs. Same program is not practicable. For a program for a pharma company cannot be same for automobile company. Clear? Automobile company cannot be same for FMCG company. Different businesses require different types of questions. What are the factors to be considered while putting up program here? It may vary in nature, size and composition. What is composition means? Combination. Combination. What type of products you are selling, what type of services you are doing. Then work which is suitable to one business may not be suitable to others. Like I said, if in some of the cases debtors are not there only, what will you go and ask about debtors there? No point. What if he says, sir, we don't do credit sales at all, full cash sales. Now you have put up a program which is for credit sales. Can I go and use this here? No. Clear? Now you tell me, you are an MC, okay, of a function. Now you host functions. A birthday party speech, can you give it at a funeral? No way. Now imagine you go there and say, here we are there to celebrate the death of this person. That's not how it works. So you have to have a different speech for different occasion. Same speech you cannot use anywhere, everywhere. That's the same logic here. One program is not practicable for everyone. Efficiency and operation of ICS. Some organization ICS is very good. Some organization ICS is very bad. Can I use the audit program for airport to railway station? No, because ICS in airport is very good. ICS in railway station is very bad. The exact nature of services to be rendered by the auditor. Some organization want only, let's say for example, audit. Their program will be different. Some organization want only review. For review program is different. I can't use everything. Same for everyone. Can I teach like this in regular class? In the same speed can I teach in regular class? Today 4 chapters I am finishing. In regular class, if I finish on day 1 4 chapters, students will finish me. Yes or no? Help at ArivuPro. Clear? Raise a ticket. Yes, so there is a difference. If an organization wants marathon from my side, there's a different plan for that. Clear? If an organization wants regular classes from me, there's a different plan for that. Okay. Keep an open mind, meaning I should encourage my people in the team to think beyond the program, think outside the box. I should not be keeping them mechanical. Mechanical means what? Like how in school, colleges you have studied. Clear? All formula, all format same. Did you question why that formula is there? No. Did we question why the format is there? No. We keep on following. We get 90, 95, 100 and we are a good student there. When you come to CA, that bubble is bursted. Clear? Because here they are not bothered about the formula and format. They are bothered about why it is there. So same logic here. I should encourage in the school, if they had encouraged us, keep an open mind. If you have any doubts, you ask, no problem. Clear? So in such cases, no, I need to encourage my people to have an open mind. Otherwise, they'll just do mechanical things without thinking. without absolutely no thought process, just keep on doing, keep on doing, keep on doing. That is not how it works. But if I do that, it might work in this program. But my staff, my people will stop thinking from their brain. Clear? So I should encourage to keep them an open mind. Experience is gained actually by carrying out the work. Therefore, I should be okay with altering the program depending upon the situation. I can't stick to that plan all the time. Clear? Now imagine you plan to go to, let's say, from Coimbatore to some other place. The general time takes is 6 hours. Okay. Now in between, tire punctured. What will you do now? In the punctured tire only you will go? No. Now you will stop. You'll have to change the tire. Time might be more, but it is necessary there. Clear? So I need to tell my people that it's okay if there is a hiccup in between the audit. Think of some other idea. Think of some other question. Don't stick to just program. Okay. Similarly, if any work originally provided for proves beyond doubt to be unnecessary, we can drop that as well. Irrelevant points, you can drop it. Relevant points, if it is not there, you can include it. Okay. The assistant engaged in the job should be encouraged to keep an open mind beyond the program. He should be instructed to note and report significant matters coming to his notice. Imagine there is a cash fraud happened, but I have not put that in the program. My staff, cash fraud, not there in the program. Why I should bother? Next question I will ask. Or should I tell my staff that if you see something like that, come and tell me, let's change the program. I should encourage them to come and tell me that. Yeah. Next, periodic review. I need to keep reviewing the program. If I don't review the program, my staff will be doing an outdated program audit. Clear? So I have to keep reviewing because changes can happen every now and then. Periodic review is necessary to ensure program remains adequate. I should not have an outdated program, number one. Number two, using an obsolete program can lead to negligent audit. Very good. You earned your CA degree after such a hard work and it will be taken away just like that. Clear? Or fine, penalty, jail, etc. Reviewing the program helps to identify and address any inadequacies or redundancy, ensuring it is more effective. When I keep reviewing, wherever gaps are there, I can plug in those gaps. How do I construct the program, sir? First of all, you have to think only with respect to scope and limitation. What is my scope? What is my limitation? Example, for review, don't put audit program, and for audit, don't put review program. Prepare the program always and always in writing, never just mentally. Clear? That's why I tell students, whatever timetable you guys are putting, it should be in writing and not mentally, because mental timetable keeps on changing every day, every second. So when you write, no, there is no changes made straight away. Get enough evidence before you put up a program. Relevance, only those steps and procedures which is relevant for that situation, for that client you have to put. You may have thousands of methodologies, but is it relevant is the question. Include the objectives for each area and set an instruction for that. Tell the assistant, see, why are you doing this particular audit? If you don't tell your assistant the objective, he will only do for the sake of it. Consider all possibilities of error and coordinate the procedures to be applied. Example, whenever you are putting up a program, coordinate, sir, sales will affect accounts. Clear? Purchases will affect accounts. Accounts means what? Finances. So I need to see whenever we are putting up a program, the interlink of multiple departments also should be taken care. Okay. It is designed to provide evidence, obviously. Now here one classic question was asked in Jan 25. Very good question, lovely question. Audit program was prepared for evidence only. Now the question is, what do you mean by available evidence? Case. A client, I am going for a client's place and I am doing the audit. For sales, I asked him give me evidence. He gave me only invoice. Okay, he gave me only sales invoice. Now, and client told, sir, I have only this evidence available. Now the question is, this evidence available, that evidence word, available word, whatever you are telling, does that mean only sales invoice or I should consider other evidences also? I should consider generally for a sale transaction what all evidences will be there. Generally. invoice from the management side, then GST records, then inventory records, then e-way bill records, then payment confirmation, yes, receipt issuing to the customer. These things should be there when it comes to sales. But what did my client give? Only invoice. And he told, இதுதான் இருக்கு இப்போ. Only this much is there. Only this is available. Can I accept that only? No, sir. Here available means what? By the word available means we do not mean evidence available with the client. Is the only available evidence. You should know what normally should be available in the context of the transaction. So if you want, you can write there and keep example evidence for sales is not just sales invoice. It can be inventory records, GST records, your e-way bill records. All these records must be kept. For a purchase, what evidences will be there? Think about it. For a purchase, what evidence will be there? First of all, requesting the purchase. Yes, purchase order. Then they will raise the purchase order from our side and deliver the goods. When goods are being delivered, GRN must be signed. Goods receipt note or goods received note. Clear? Once that is there, in the register they have to enter. These many goods have been received. Once that is done, it will go to the purchase department. Yes. So in their record it should be there. From there it will go to inventory department. Clear? And from there it will go to production department. Once it enters the premise, that bill will go to accounts department and accounts department will make the payment. All these are proof only, But if client says only purchase bill is there with us, that is not the meaning of the word available. Available means for a transaction what normally should be available, that should be there. If that is not there, I can conclude that Sai is not there. Okay. However, place appropriate weight on each piece of evidence. Do not ignore any evidence. Generally, evidence is classified into what? Documentary, physical verification or physical examination, management statement, third party statement, calculation, ICS status, interrelationships of various accounting data. Example, sales and accounting or sales and finance. Clear? Marketing and finance. There is a relationship between various accounting data. Minutes book gives me evidence of decisions taken. Minutes book gives me evidence of what? Decisions taken. Then subsequent action by client and by others. Now example, this was asked in the exam also. Examples of evidence to be taken. For cash in hand, what is the best evidence? Physical counting. You have to go there and physically count. For investment pledged with the bank, what is the evidence? Banker's certificate. Okay. May 25. Read. Good question it is. Read from here. Messrs. YZW and Co. Chartered accountants have been appointed as stat auditors of First Health Private Limited for the financial year 24-25. CAY is the engagement partner for this assignment. First Health Private Limited operates in the business of hospitals and pharmaceuticals with 60 hospitals and 200 pharmacy stores across the country. The company has a turnover of 680 crores and PAT of 32 crores in the current year. While verifying the assertions about book debts, CAY was informed about availability of clients' ledger invoices, debit notes, credit notes as evidence. He accepts these documents considering them to be available. Is this decision correct? Meaning they are telling that whatever management gave, that only he considered as available. Is that true? No. Available in the context of the transaction, not in the context of management. Therefore, is his decision correct based on the meaning of the term available? The decision is wrong. Explain how we should select the most appropriate evidence when testing the accuracy. So as to select the appropriate, place appropriate weight on each piece of evidence. Whichever is more reasonable, consider that as evidence. And example you have to write. For cash in hand, best evidence is counting. For investment, banker certificate. You can give more examples. Cash at bank, what is the best evidence? Manager's certificate. Clear? Debtors, what is the best example? External confirmation. So like that, you can write a couple of examples. Now, developing the program, step number 1 is planning. And for planning, what is step number 1? Strategy. Strategy comes first, then comes plan, then comes program. Sometimes it should be reconsidered for modification because of ICS, preliminary evaluation and other procedures. Then you should have a program in written format. Tell your assistants what is your objective and give proper instructions. Then point number 4, reliance on internal control. This is important. Reliance on internal control. You should have an understanding of accounting system and ICS on which you are relying. Once you have tested those systems, you may conclude on relying on ICS is an effective and efficient way. You may decide not to rely on ICS also. It is whose call now? CA's call. Once you check ICS, you can decide whether I want to rely on that or not. If you are relying on that, my time will be saved. If I am not relying on that, I need to put more efforts. Also consider the 4 factors. Timing of procedures. When are you going to put the procedures? My question to you. You have 2 options. Option A and option B. Right? Both are ICS only. Both are ICS only. Option A gives you less effective evidence. Option B gives you more effective evidence. Which one will you follow? Option B. But option B, if you follow, you have audit report. You have to finish audit report in the next 1 week. But if you follow option B, you will take 15 days to finish audit. Now which one will you follow? There is a due date. Within the next 1 week, you have to finish your audit report. But if you go for option B, you will take at least 15 days to finish the audit. But gives you best evidence. On the other hand, there is option A, doesn't give the best evidence, but still gives you the evidence, and you have to finish audit within a week. Which one will you go for? Option B or A? If you go for option B, you won't be able to finish within due date. What is the point of getting the evidence? Number 1. Number 2, if I go for option A, I never said it is bad evidence. No. I just said option B gives me better evidence. I am still okay with it. If I was there, I would still take option A, because what is more important? Due date is more important, and in that case, whatever is the best method for me at that point of time only I will take. Understood? Clear? Now, timing of procedures. Sir, if the time taken is more, it is better I stick to one of the options. Coordination of assistance from the client. Sir, client should help me, but client is not there to help me. He is busy in something else, and I have to finish my audit. I will be settling for option number A only, because option A, I only can perform the audit, or I only can perform the function, whereas option B, client should come. Which is better? Option B is better if there is enough time. But if there is no time, client is not helping me, option A only is better. Availability of assistants. Sir, for option B, I require my people to be there. I need more people. Not there. Therefore, I will rely on option A. Involvement of other auditors or experts. If I have to go for option B, I need to involve other experts. They are not available. What is the best option available for me now? Option A. Therefore, I will do that only. Okay. Timing of performance. Generally, auditor has flexibility in deciding when to perform what procedure. But in some cases, he doesn't have any discretion to timing. Example, regulatory says within 15 days of end of quarter, you have to give me a review report. Now, I can't decide my own timing there, because law has put a specific timing. I have to stick to it. But generally, who decides which procedure when to put? Auditor. But there are certain circumstances where I don't have any discretion. For example, I can decide when I should do marathon. Okay. Now see, for example, regular classes are going on. Correct? For you guys, regular classes are going on. Now, if I decide that I will finish off your regular classes, then I will do marathon. When is January attempt? When is it starting? 6th. Now imagine I finish your classes on 25th. Regular classes. The law classes is going on. I will finish on 25th. Imagine after 25th, 1 day break I will take. 26, 27, 28, 29, I will do audit marathon. Is it useful? No. Does it serve the purpose? No. So technically, generally, I can decide when I should do marathon. Correct? But now I don't have the discretion with respect to the timing. So I have to conduct at the earliest. Yes. So that's the reason what did I do now? I kept the regular batch on hold. finishing the marathon, then we will continue the regular batch. Now I don't have the discretion of that particular timing. So in some cases we will not have the discretion, most cases we will have the discretion. So remember, most cases, 99.9% of the time you have the time, but situation wise I don't have the time. What are the advantages of program? Clear set of instructions can be given to my people. Total perspective, holistic view I can get. Selection of people becomes easier because their capability is what I know. Reduces danger of ignoring or overlooking books or entries. Accountability, I can hold the people responsible. I can have the control over the progress because everything is in writing. So I can see what is the status of my team's work. It serves as a guide in the succeeding year and serves as evidence in case of any charges has been filed against me. That is, if anyone files a case against me, I can have the evidence to say, see boss, I have done my audit properly. What are the disadvantages? It may become mechanical. Now this I don't agree with this. I also tell this in regular class. I don't agree with these disadvantages because these can be worked upon. See, it may become mechanical when I don't tell you why you are doing it. Yes, but if I tell you why you are doing it, is it mechanical now? No, I'll start giving you the thought process, creativity. Think about it is what I will be telling. Don't you think we have already studied keep an open mind concept in program? When I tell you to keep an open mind, where it will become mechanical? It doesn't become mechanical. Clear? Becomes too rigid or inflexible. Again, I don't agree with this. Why? How can it become rigid and inflexible when I'm allowing you to conduct a periodic review of program? Whenever we are reviewing program, we are there to change it also. Therefore, it doesn't become too rigid or inflexible. Inefficient assistance may take shelter behind the program. This, yes, I agree with this. Imagine a team of 5. In that 3 are very good, 2 are inefficient. The team performs well. Why? Because of the 3 people there. So these 2 people will never be able to, I won't be able to find out they are inefficient. That's one disadvantage. Hard and fast program may kill the initiative of efficient assistance. Again, I don't believe this because I am asking him to keep an open mind. So technically, these are not disadvantages. The only disadvantage I am seeing is third one. Inefficient assistance may take shelter because I am only preparing everything and giving it to you. Understood? Clear? Okay. Now, what are the questions that have been asked? First one, AP and Co. Chartered accountants, Jan 25 question, appointed as statutory auditors of Heavy Industries Limited, listed company engaged in manufacturing of electric vehicles. What are the requirements, sir? Whether CAP is required to consider about the maintenance of digital database while framing. Sir, digital database, physical database, whatever database, should I consider it in strategy? Yes, because it is an asset. It is information. I have to consider that in a form of strategy. Clear? Whether procedure planned by CAP are in line with SA 300. Now, this is a classic case. Continue reading. As per the recent guideline issued by a regulatory authority, every listed company is required to maintain the digital database of all those personnel who could access the books of the company to avoid insider, it is trading. Okay. In case of non-compliance, hefty fines may be imposed. CAP is the engagement partner from auditor firm for Heavy Industries Limited. During planning, he planned that he would inquire from in-house IT head of the company about the maintenance of digital database to identify and assess the risk of non-compliance. So what did he do? He inquired from in-house IT head of the company about maintenance of digital database to identify and evaluate risk of non-compliance. Did he do things right? Yes. Clear? Because when in the planning, he has to include nature, timing and extent of procedures. So he has to put a procedure in the plan. He went to the IT department, asked how are you going to save this digital database and what is the security. That is absolutely right. I would say please go home and solve this question by looking at institute study material, or rather suggested answers. Next, see here also 5 marks, here also 5 marks. This chapter can easily give you 10. Easily can give you 10 marks because most of the things are that 90% of the time it will give you direct. Okay. Z Limited engaged ABC Co. Chartered Accountants to conduct its statutory audit of financial year 23-24. The team developed an overall audit strategy and plans to address the risk. During the several significant changes occurred, including the discovery of material misstatement in inventory valuation and changes in the scope of procedures due to an unexpected acquisition by Z Limited. The audit documentation of Z Limited should reflect these changes, but the auditor of the company failed to document the strategy and the plan. So, I can see they are targeting documentation part. As a senior auditor of the firm, briefly outline what should be included in the documentation of strategy and plan and how the documentation addresses significant changes. I told you three things. Repeat after me. I told yes, both should be documented. Strategy sets scope, timing, and direction. Plan sets nature, timing, and extent. When I document the strategy, strategy helps in giving evidence of key decisions. Procedure helps in giving evidence of
procedures.
what type of procedures we have performed and how we have performed. Changes gives an evidence of why the changes we had performed. That point you have to write here. Clear? And give a conclusion. Okay. Then, preliminary engagement activities include certain activities to be performed by an auditor while planning an audit. Discuss such activities briefly. How performing such activities assists an auditor. Sir, God promised such type of question in the exam they will not ask. Reason being is they are asking preliminary engagement activities, all 3 points. That is our first one, ethical requirements. Number 2, independence part, acceptance continuance, as well as SA 210 point. This is a classic RTP way of asking question. Clear? They will not ask you such a lengthy answer in the exam, because if they ask that, no, they have to give more marks. And they can't afford to give more than 5. Maybe from that 1 or 2 they can ask. But if I was the examiner, no, I would not test you on those concepts as chapter 2, because I would ask you in chapter 11 only. The more origin is from there. CA is assigned responsibility of drafting audit program relating to purchases appearing in the financial statement. Help him drafting a sample program for purchases. This also they will not ask, because when new syllabus was introduced, first RTP of new syllabus was this question. Clear? And what they are asked in your study material, no, they are given one sample program. Clear? One sample program they are given with 4 questions. Same copy paste they have done, but for purchases. Clear? But I'm still giving you as an RTP question. September 24 RTP question. CAN, engagement partner of LPS and associates, planning for audit of a large company. As part of preliminary engagement activities being performed in this regards, he wants to ensure that compliance with independence requirement is adhered. How shall he form a conclusion that firm complies with independence requirement? Basically, preliminary engagement activity element number 2. Clear? That you are supposed to write. Jan 25 RTP. During the audit of ABC Limited, medium-sized manufacturing company, the partner is responsible for directing, supervising the work of engagement team. Clear? The moment I see directing and supervising, I get an idea that they are talking about SCAR. Clear? That is directing and supervising the review of the work. So clearly they have told what factors should the engagement team members should consider when determining NTE of direction, supervision and review. Size and complexity, risk, yes. Then what? What else? SCAR, size and complexity. Then capabilities and competence, risk of material misstatement, and one more. Very good, area of audit. Clear? Next, RTP September 25. CA Rishu is appointed as an auditor of manufacturing company with complex supply chain, multiple inventory location, and recently introduced financial reporting requirements. Some article assistants and an expert assigned for inventory verification are forming part of audit team of CA Rishu to ensure that risk is reduced to an acceptably low level. CA Rishu is focused on developing an effective and efficient plan. What do you want? So much you told story. What exactly you want? benefits of planning. Now you tell me, from here till here, it is waste. Straight away they are asking what? Benefits. In the exam, if they give you a para, that doesn't mean it is a case. Requirement defines whether it is a case or direct. Eighth one, September 25. Guide the student in answering the following. What type of evidence shall an auditor look into as most appropriate in verification of an assertion? Specify the most appropriate evidence. Just now we saw available point. Clear? Available means not available with the client, available in the circumstance. For cash in hand, what is the most appropriate method? Counting. Investment pledge, what is the most appropriate method? Bankers certificates. Same, 5 marks for this. Clear? Then CA Taman. See, here also 5 marks, September 25, here also 5 marks. So, technically, if you see alternative attempts, they have asked for 10 marks. Clear? That doesn't mean every attempt they will not ask. MCQ they can ask. This is only descriptive part. Okay? CA Taman is the auditor of a company dealing in trading of mobile accessories. This year, the company has also started assembling mobile phones. Clear? Now, what do you want? Straight away come to the requirement. Factors considering when planning nature, timing, and extent of. What is this? SCAR. This point, you're right. If during the course of audit, he discovers information that significantly differs from what was available were initially planned, then what he must or she must do? Change in plan. Clear? If there is any information that differs significantly, then obviously I need to change my strategy, I need to change my plan, accordingly I need to change my program. Got it? Clear? That is your chapter number 2, question number 9. Clear? Easily you can expect around 10 marks. Clear? Going with the trend, Jan they have asked 10 marks, September they have asked 10 marks, and the next attempt that you are writing will be Jan. Clear? And where, remember, documentation is very important right now. Institute is focusing on. Wherever documentation part is there, they will ask. Clear? Now in May also they have asked a few questions here. May 25 you see here they have asked 5 marks. Clear? Then somewhere I think one more question was there. September we have covered this. May 25 again 4 marks here. That means totally around 9 marks they have asked. So on an average you can expect around 10 marks including my MCQ thing. Okay. So every attempt this chapter you don't have to skip it. You just have to study with 3 different divisions: planning, strategy, planning and program. Clear? Focus more on documentation as well. Okay. That is your chapter number 2. Now let's come to the most important part, that is Caro 2020. 4 marks you can expect. 4 marks you can expect. Yes. Now, there has been amendment here, but not applicable for Jan. Okay, not yet applicable for Jan. What is that amendment? I'll tell you. It's a consequential amendment. Sir, applicability of the order. For whom it is applicable? Every company, including what is foreign company? See, we are studying company law now. Okay. Yes, small company amendment only, but not applicable for Jan. Here, some say it is applicable for May, but the amendment came in the month of December. Okay. Generally, for a May attempt, they consider 6 months before is a cutoff date. I personally would always wait for institute to give that particular notification of amendment. I personally wait for that. Clear? Your other faculties or whoever from wherever you have studied, if they have told it is applicable for it, I do not know. I personally wait for institute to come up with a notification saying these are the amendments, which generally in their website only they will give what is the amendment and where is it given, right? If we go to their website, where is it? If you go to their website, go to students BOS knowledge portal, For those who do not know, it will be helpful for them. Here if you see, there is amendments and developments. If you go and click here for intermediate, no, see they'll give you like this. What is the amendment? Now, for audit, I don't expect them to come up with an amendment that way. They can come up with an amendment saying paper to small company definition they can amend. But if small company definition gets amended in the syllabus for you, automatically in Caro, here small company also gets amended. Clear? Right. So what is foreign company? Company incorporated outside India and having place of business in India either by itself or by agent, physically or electronic mode, and conducts business activity in any other manner. Clear? So therefore, every company, including foreign company, will have to follow Caro, but there are exceptions. First exception is who? Banking company. Why? Banking company reporting, Companies Act will not bother because they have their own father, RBI and Banking Regulation Act. Insurance company will not be bothered because IRDA will be there. Section 8 company will not be bothered because you are not at all doing profit. Why do I want your reporting requirements? One person company, sir, you live, that is good enough. You do your business. You are exempted from such reporting. Small company, what is the definition of small company? For your exam, paid up capital is equal to 4 crore, turnover is equal to 40 crore. Minimum or maximum? Minimum or maximum? Maximum. Both should be satisfied. PUC should be less than or equal to 4 crore. Turnover should be less than or equal to 40 crore. Clear? If you exceed this any one limit, you are no more a small company. And small company is a public company, no? It's a private company. OPC also is a private company. Clear? Right. Now, let's talk about specific private company. Here also, I want to give one small clarification where I will tell you. Private company, for which private company it is not applicable, sir? For that private company which is not a subsidiary or holding of a public company. Sir, can it be a subsidiary of a private company? Yes. Can it be a holding of private company? Yes. It should not be a holding or subsidiary of another public company, they have told. Plus, your PUC plus reserves and surplus should be less than or equal to 1 crore. Clear? Paid up capital and not nominal value of the shares. Number 1. Paid up capital and not market value. Not nominal value and not market value. Clearly paid up capital. We don't care whether the shares are fully paid or partly paid. Paid up capital we have to take. Clear? Reserves and surplus, all type of reserves. Now you will tell, sir, notional reserve, everything, all type of reserves we will consider. Clear? It should be less than or equal to 1 CR. Total borrowings should be less than or equal to 1 CR from banks and FI. That means from individual if you take, good, no problem. From body corporate you take, no problem. LLP you take, no problem. Company to company, no problem. Only from banks and FI, if it is less than or equal to 1 crore, only exemption will be given. If it is exceeding 1 CR, exemption will not be available. But this exemption when I should see at any point of time, not just on balance sheet date. PUC and reserves and surplus I should see on balance sheet date, right? Borrowings I should see any point of time. Now, revenue should be how much? Now, this is where I want to give a clarification. Clear? It is less than or equal to, I gave you the clarification in the regular class as to how and why. Clear? The language used in the law is suggesting that it is less than or equal to, but some consider it as only less than. Clear? I consider it as less than or equal to because of the language and consistency. Now, what is consistency? See, here also they have used less than or equal to 1 crore. Here also they have used less than or equal to 1 crore. Clear? Here it means less than or equal to 1 crore because of the wordings. Now don't say that Karthik sir is blabbering on YouTube video, chumma like this, like that and all. No. You get the wording, you go and read the wording. It clearly suggests that it is less than or equal to 10 crore. So for me personally, I consider it as less than or equal to 1 crore. Reason being is, even in institute material, they have not put the sign. They have given the wordings. Clear? So it should exceed for you to be applicable. Right? Even if it is equal to, it is not applicable. Number one. Number two, sir, when we talk about revenue, what do you mean by revenue here? Revenue means what? Is it from operations or is it total income? Huh? We have to take total income into consideration. Clear? Okay. Now, sir, this is the applicability of Caro. For whom it is applicable? Everyone. That is not the point. For whom it is not applicable? Many times this they have asked. Banking, insurance, Section 8 company, OPC company, small company and private company. Private company, 4 conditions you have to satisfy. Number one, you should not be a subsidiary or holding of a public company. Second condition, paid up capital plus reserves and surplus should be less than or equal to 1 crore. Borrowing should be from whom? Banks. Financial should be less than or equal to when? At any point of time. PUCRS, balance sheet date. Revenue, again at any point of time, should be less than or equal to 10 crore. Clear? Okay. Now, Caro 2020, we give 2 times. Clear? One is on SFS, one is on CFS. Total clause in Caro is 21. Out of that, in SFS we have only 20 clauses to talk about. CFS we have 21st alone, not 21 clauses. Only 21st clause will be talking about. The rest 20 clauses is only for whom? Standalone financial statement. So basically here 20 clause for SFS, 1 clause for CFS. Which is this 1 clause? 21st clause only. Clear? Okay. Now what is the 21st clause? Opinion in CFS where there have been any qualification or adverse remarks by the respective auditors in the company's audit report of companies included in the consolidated financial statement. If yes, what are we supposed to do? Indicate the details of the companies and the paragraph numbers of Caro report containing qualification or adverse remark. In regular class, I gave you the task. We did the task together in the class where we went to Adani's report. Clear? From Adani's CFS, we went to NDTV report. We opened that NDTV report. Clause number 17 with respect to cash loss, we had checked for both years. So how does it work? It works. Imagine CFS ka Caro you take. In CFS ka Caro, they will tell which subsidiary, which associate, which joint venture has negative remarks in their individual Caro. In their individual Caro, that paragraph number I should put in CFS Caro. How does it work, sir? For those who do not understand that. Now, if you go to Adani Enterprise, okay, we will go to their financial statements. Here, let's go to their CFS. If you go to their CFS, we will go to their here. There you go. Now, this is their 21st clause. Okay. Summary of comments and observation given by us and respective auditors. Now, see, line by line, they'll give you the company name, their SIN, what is the relation, and which is a clause number. Now, this is where we went on to see NDTV. Now, U means unlisted, so I will not bother about that. Let's go to the listing ones. Here, 47th. New Delhi Television Limited. Here, which is the para number? Para 3, clause 17. Yes. Now, what we'll do? Remember, para 3, clause 17 of NDTV. Okay, financial year 24-25. Now, what I will do? I'll go here. Financial year 24-25. Standalone financial statements we should go and check. Page number 161. Right. Here if you go to their Caro, clause number, see this is Caro, okay, clause number 3, para 3, clause number 17, 16 and 17. Yes. Company has incurred cash loss in the current financial year and the immediately preceding financial year. Clear. Now that is what clause number 21 stands for. Clause number 21 is a one-stop shop where what all my substitutes negative features are there in Caro, I'll be giving it in clause number 21. If you are a member, you go read the respective Caro and get to know what that information is. Got it? That is what clause number 21 stands for. Now, let's talk about first clause, which talks about property, plant and equipment. Clause number 1, subclause A, PPE. Whether company maintaining proper records showing full particulars including quantitative details and so we should, here in Caro, sir, should we go and do investigation? No. Normal audit procedures when we are doing, whatever information we receive, we have to report it here. Here, we just report the answer. Okay, what we should ask them? Have you maintained proper records which showing quantitative details and situation? What does situation means? Status or condition of the asset. Idle, scrap, obsolete, active use, etc. Number 2, intangible asset. Whether the company maintaining proper records showing full particulars with respect to intangibles, that is patent, copyright, trademark, software, etc. Second subclause, have you conducted physical verification at reasonable intervals? Now reasonable intervals, they'll not ask you, but what is reasonable intervals for property, plant and equipment? Once in a year, once in a year. Guidance note says once in 2 years. But if you want, you can do once in a year. Guidance note is mandatory or not mandatory? Not mandatory. But those who do not know, they say, we'll follow guidance note, sir. But can client say, sir, once in a year we'll go and verify? Yes, you can verify, absolutely no issues. But can I verify once in 10 years? That is unreasonable. You do it, but we call it as unreasonable. What is reasonable? Once in 2 years is reasonable as per guidance note. Next, whether any discrepancies were noticed on such verification? If yes, whether the same has been properly dealt in the books. What does discrepancy means? Any negative points have been notified, it has to be dealt. Example, physically verify, when we are doing physical verification, we got to know some asset is sold. But in the books of account, it is still shown as asset. It has to be properly dealt in the books of accounts. Third, 1C, whether title deeds of all immovable property should be in the name of whom? Company. And what should be mentioned if it is not in the name of company? Description of the property, gross carrying value, held in the name of, whether that fellow is a promoter, director or a relative, period held and reasons for not holding. Now you tell me, whatever business you are doing, either that should be a rented premise or own premise. If it is own premise, it should be in whose name? Company's name. If it is not in company's name, then you have to give details. I'll show you one particular Caro. You will be shocked to see how many assets are not there in the name of company. If I go to their standalone financial statements, here, take a look at their Caro with respect to their land. See, reporting as per Caro, immovable property not held in the name of company, freehold land, building, leasehold land, leasehold building, etc. Till here. Clear? And if you look at the range, period 1977, 2006, 2010, then reasons for not being held in the name of company. Why? The lease agreement not yet signed due to dispute with Tuticon Port Trust on incorporation of MGT clause or other management clause. 2006 case pending in High Court. Transfer is under process. Transfer is under process from when 2010. Clear. So like this, they'll tell it is not in our name. It is in someone else's name. Clear. Held in the name of government of Assam, government of Bihar. Clear. Not available. This fellow died also. T. Subramaniam Reddy. Clear. Oil India Limited. Ministry of Defense. Railways. So like this, they will give you whether he is a promoter, director, employee, or relative. No. Period held. Reasons for not being held in the name of company. Like this, reporting has to be done. Now, but the thing is, this reporting is a format given by order. So I can't change the format. That's why if you see format is same. Clear? But if they do not give any format, they say give the details. For example, here showing full particulars they have given. Yes, whether they have been dealt with the books of account or not. Now in any case they say give details. Format is not given. That time in which format we have to give? In the format we like. But guidance note already has given you the format. It is much better to follow guidance note. Tomorrow simply we have to sit and give explanation for the users as to why we have not followed a different format. Okay. If the format is given in the order, you have to follow the same format. Next, D. Whether company reevaluates PPE, and if yes, whether revaluation is based on registered valuer, specify the amount of change if the change is 10% or more in the aggregate of net carrying value. Here one small trick and tip is there where I can actually trap you. What they're telling, if the company has revalued its PPE, you have to disclose the revaluation. You have to disclose the fact of revaluation, not the amount. When you should disclose the amount, if the revaluation is 10% or more. Clear? What students will think, only if the revaluation is 10% or more, this clause is applicable. Wrong. This clause has two parts. Part number one, fact of revaluation. Whether revaluation has been done or not, you have to disclose this. Amount I will disclose only if it is 10% or more. If it is less than 10%, I will disclose the fact of revaluation but not the amount of revaluation. If it is more than 10%, I will disclose the fact also, I will disclose the amount also. Got it? Next. In case of point number E, whether any proceedings initiated or pending against a company for holding what property? Benami property under Benami Property Act. And if yes, whether company has appropriately disclosed the details in the financial statement. Meaning any case has been filed on the company, they have to disclose in the financial statements. Inventory. Clause number 2, subclause A, same, whether physical verification of inventory have you conducted at reasonable intervals, and whether in the opinion of CA, the coverage and procedure by the management is appropriate. Sir, what is reasonable intervals here? Once in a year. Clear? Once in a year. Because institute now sometimes will give you surprise. They will be like, fixed assets have been verified once in 10 years, comment. Now, technically for you it is not there. In the study material, they have given only reasonable intervals. Now, in the exam, what will you write? Smart students, what they'll do, they'll chumma write reasonable intervals. Clear? But these students who are over smart, they'll tend to give 10 years is unreasonable. Did they ask you that? Clear? You have, that's the reason why I don't take the risk. If over smart students are there, you still write no problem because I've given you the fact. Once in 2 years for asset, once in a year for inventory. Clear? Even though you want to write, you can write this because they can't cut the marks here. Because who gave this information? ICA only. Clear? Then, if there is any discrepancy of 10% or more, no problem. It has to be properly dealt in the books of accounts. This is important. Whether during any point of time of the year, the company has been sanctioned working capital limits in excess of 5 crore. If yes, on the basis of security of current assets you would have given. Yes. Whether the quarterly returns or statement filed is up to date or not. This you will actually relate with the drawing power in bank audit. In drawing power, we remember that, you should remember that it is calculated based on current assets. Value minus margin. Clear? Whatever is the value minus margin is what we consider as drawing power. There, we have to understand bank will ask for updated stock statement every month. But if you are a big company, or if you're a big organization who has taken loan for you once in 3 months is what bank has told. Here we are talking about that once in 3 months only, because you tell me da Caro is applicable for big companies or small companies? Large borrowers only. Because if your OPC not applicable, small company not applicable, private company with paid up capital reserves, etc., 1 crore is not a small amount. But if it is not applicable for you, that means for other companies it is applicable, which is on a bigger level. Got it? Now imagine, I'll ask you one question. Okay, you tell me here, if a private company which has paid up capital less than or 1 crore, exempt. What about small company? 4 crore, which is beyond 1 crore, Caro applicable, not applicable? Applicable, not applicable? Because small company's paid up capital is 4 crore, private company for exemption paid up capital is 1 crore. Now, if I am a small company, I am a private company also, my paid up capital is 3 crore. Is Caro applicable or not applicable? That's the googly question. The googly question is, I will not tell you that, I'll just say a private limited small company whose paid up capital is 3 crore, turnover. Here though how much they have told, revenue 10 crore, therefore small company it is 40 crore. No, what if my turnover is 30 crore and my paid up capital is 3 crore? Is Caro applicable or not applicable? Not applicable or applicable? 5 marks easy question I'll give you. It is not applicable. You know why? The moment you say small company, I don't care about your limits. Clear? The moment you say small company, the question, I will be least bothered about your paid up capital and turnover. Second difference is that turnover is different, here revenue is different. Revenue includes other income. Turnover does not include other income. Second hint in the question. Clear? So technically what? Small company definition keeps on changing. This never changed. Clear? This particular logic came when small company definition was 50 lakhs and 2 crores. But small company definition kept changing. Clear? This never changed. So for that there is a clash now in the exam. If the question clearly says small company, then forget about any other criteria. Straight away say Caro, not applicable. But small company is not given, then other criteria should be checked for. Got it? Next, inventory done. Let's move on to LIGs. Loans, investment, guarantee and security. First, I should check whether during the year company made investments in, given any guarantee, given any security. To whom? To anyone, sir. To companies, firms, LLP or any other parties, I should ask. Question number 1 I'll be asking is, did you make investments? Did you give loan? Did you give guarantee? Did you give security? To whom? To anyone. If yes, I will put a comment here. If no, also I will put a comment here. Then, under that, if yes, I have to disclose 2 things. Aggregate amount. What does aggregate means? Total amount during the year, that is from April to March, how much you have given, and balance outstanding as at balance sheet date. So as on 31st March, what is the amount outstanding? You know why? What if as on 31st March outstanding is 0, but during the year I have given and taken? Loan, in the month of May I have sanctioned 10 crore, in the month of August I got the 10 crore back. As on 31st March, what is my outstanding? 0. So I want to tell the users, see, as on 31st March, nothing is outstanding, but they have given and taken loan with these people. The members will start asking questions based on that. Okay. Second, total amount and outstanding. 2. One is separately have to report to subsidiaries, JVs and associates how much you have given. Then second is to outsiders, parties other than subsidiaries, JVs and associates. Sir, why this bifurcation, sir? This bifurcation is because I want to know how much money you have given to our members and how much money you have given to others, outsiders. Clear? Second, whether investments made, guarantees given, securities given and terms and conditions of grant of all loans and advances in the nature of loans and guarantees are not prejudicial to the company's interests. Sir, do anything, but it should not affect the company. So even though you have given loans, security and all, you should not be going against the company. After discussing this clause, I'll tell you the googly question here. Third, in respect of loans and advances, in the nature of loans, schedule of repayment have you given to the organ or whoever you have given loan to. I don't know if you have observed, if you have taken any goods on EMI, it could be, let's say, for example, laptop, mobile phone or anything. When you go to, let's say, for example, Bajaj Finance you have done. Clear? Whenever you are buying on EMI, no, let's say 2 years EMI you have purchased on. Whenever you have taken something on loan, the loan giving organization will give you a schedule of repayment. Clear? Every month or every EMI, they'll give you a schedule. Clear? Now, for example, in case of Bajaj, if you have Bajaj loan going on for any device or anything that you have purchased, no, in their app, when you go, you just have to click on repayment schedule. They will give you a repayment schedule. One PDF will be downloaded. Every EMI, how much is interest, how much is principal, how much is outstanding will be given to you. That should be given like from the companies. Clear? That is the reason why they give. If the amount is overdue, what is the total amount of overdue for more than 9 days and whether reasonable steps have been taken for recovery. Sir, what do we call this particular account as? If the amount is overdue for more than 9 days, what do we call this as? Overdue for more than 9 days. In banks, what do we call them as? Non-performing asset. Clear? So what do we call this account as? If the amount is overdue for more than 9 days, what do we call that as? No. Loose tools. I am leading you to a trap. It is in bank non-performing asset. CARO is not applicable for banks. Clear? So we don't bother about NPA and PA here. We just say, is there any amount which is overdue for more than 90 days? If yes, see whether they have taken proper steps for recovery. Like when mad people don't go under it, this is called NPA and proper provisioning should be checked. Because the entire order is not applicable for what? Banks. Clear? Then, point number E, whether any loan or advance in the nature of loan given has fallen due during the year, did you renew that loan? Did you extend that loan? Did you give fresh loans to settle the old loans to the same parties? If yes, mention 2 things. What is the total amount you have done like this? And what is the percentage? Very good, sir. Classic case. Imagine you owe me 1 lakh. Okay. Today is a due date. You come to me and I say, give me my money of 1 lakh. You will tell, I don't have. You do one thing. Give me 1 lakh more. Clear? So I give you 1 lakh more. That 1 lakh you give me back. And you tell, old loan settled. Now, this is actually the case. Clear? Now you tell me, what happened here? Nothing happened. The loan comes back to the same outstanding. But you know what is the difference? When the old loan closes and new loan opens, the tenure will be extended. Clear? So if old loan is outstanding, interest keeps on adding. Yes. So now what you will do? Now you will take a new loan. Although here also interest is there. But now the terms are different. That won't be overdue anymore. Clear? So what I will do? I owe you something. I take money from you only. I give money back to you only. And I tell this is for old loan. Now new loan is pending. Clear? If they have done something like that, then I need to report. Clear? Falling for the same trap since classroom. Yes. I keep telling them it is not NPA, it is not NPA. You keep falling for the same trap. I can't do anything. In the regular class also I keep telling you this is a trap. Clear? Then 3F. Whether company has granted any loans or advances in the nature of loans either repayable on demand or without specifying any terms. Tell me one thing. You don't know me, I don't know you. Okay, I come and tell, give me 50,000 rupees. Okay, no terms at all. Whenever you ask, I will give. Or no terms. Whenever I feel like I will give. Will you give it to me? No. But will you give it to your parents? I mean, imagine you have money. That one doubt will come. Imagine you have money. Will you give?
Yes.
Yes. That means you will give only to related parties. No? To a stranger, will you give? That's the logic. So here, these type of loans for whom you will give? Either to promoters or to related parties. If the company has given it to them, then I have to notify it to members under this particular clause. Clear? So basically, this is talking only about four things: loans, investment, guarantee, and security. Now you tell me one thing here, sir. For which clause is applicable for which? Four things are there: loans, investment, guarantee, security. For investment, which are the clauses which is applicable here? Clause number, subclause number A. Because here there is investment. Yes. If you have made investment in, that means clause number B alone is applicable. C, D, E, F is not applicable for investments. For investments, it's only B. Clear? A, yes, A is an enquiry where we are asking have you made investments or not. If yes, then only clause number B is applicable for you. But if you have given loans, what all is applicable for you? A is applicable for you. Sir, is B applicable? No. But C applicable? Yes. D applicable? Yes. E applicable? Yes. F applicable? Yes. What is not applicable then? Only B is not applicable. Guarantee and security you have given. Which is applicable? Is A applicable? Yes. Guarantee also is there. Security also is there. Is B applicable? Yes. Security also is there. Guarantee also is there. Is C applicable? No, because they only told loans and advances. Is D applicable? No, if the amount is overdue. E applicable? No. Yes, sir. Where? No, this is with respect to loans and advance. Is F applicable? No. Therefore, if it is guarantee and security, B and A. B and A. Have a clarity on this. Because in the question, if I have to give you a tough time in the exam, no. If I am asking about investments, only one clause is reportable. If I am asking about guarantee and security, only two clauses reportable. If I am asking on loan, all clauses reportable. Got it? Clear? Okay. Next, compliance of section 185 and 186. Again, continuance of clause 3 only. What they are trying to tell is, sir, if you have given loan to directors, right? Or if you have made investments in the company or by the company, you have to follow section 185 and basically, have you followed or not? If you have followed, I will mention you have followed. If you have not followed, I will mention you have not followed. Deposits. In case if you have accepted deposits by the company or if those who have done with law, chapter 5 in your corporate law is called acceptance of deposits. Under that, there are certain rules and regulations. Before accepting the deposit, you have to follow the rules. What are the section number? 73, 74, 75, 76. 4 sections are there. Have you followed all 4 sections or not? Clear? You will not. Those who are not done with law, you will not relate to this. Clear? Because in law, there is a chapter for that where before accepting the deposit, you have to follow certain rules and regulations like passing special resolution, OR, ROC's permission, creating reserve, and all those things are there. Clear? Those have you followed or not? Here they will not ask you. Here you just have to report whether they have followed this particular section or not. Cost records is given under section 148. Whether maintenance of cost records have been done under section 148(1) or not. Here again, I will have to shift to company law. Section 148 clearly says there are 39 segments, sectors which are notified by central government. Clear? In that, 33 non-regulated sectors, 6 regulated sectors. So, under Companies Act, if you cross 35 crore revenue or turnover, if you cross 35 crore turnover, then you should maintain cost records. If you don't cross, you need not maintain cost records. Certain rules are mentioned in section 148. I am supposed to just go and check. Have you maintained as per the section or not? Next is statutory dues. Statutory dues means what? Dues which are supposed to be paid under a specific law. But here, your bills like electricity bills will not come into the picture. It is not a statutory due. It is consumption based. Clear? Whereas GST, income tax, EPF, ESI, these all come as business dues for you. You will have to pay that. If you don't pay within the due date, then we will call it as a disputed or undisputed. So we should first see, why didn't you not pay? It is overdue. Why didn't you not pay? If there is a dispute with respect to you and the your department, then we will segregate that into disputed dues. If you have paid it without any dispute, we call it as undisputed statutory dues. Example, the income tax department sends a love letter to you saying you are supposed to pay 150 crores. Now you have filed a return by paying 100 crores. Clear? Now out of that 150, we will take into two parts. Disputed, undisputed. How much is disputed? 50 CR. How much is undisputed? 100 CR. I don't have any problem with 100 CR. I have only a problem with that 50 CR. So what I will do, I will first see whether 100 CR is paid within the due date or not. If yes, good. Clear? If you have not paid 50 CR, it definitely will not be paying because it is a dispute. In case of dispute, I should report two things. Where the dispute is pending and how much is the amount. Clear? That is what they have told. If the company is regular in disputing undisputed statutory dues, including GST, PF, ESI, IT, sales tax, service tax, customs duty, excise duty, like one hotel menu they have given. Clear? So if you are regular in paying this, I'll have to report. To whom? Appropriate authority. And if not, the extent of arrears, how much you have not paid, outstanding statutory dues as on the last day of financial year concerned for a period of more than 6 months. How does it work, sir? It works like this. Imagine 100 crore, okay, you have not paid. Now, I should see what is the period of outstanding. If the period of outstanding is more than or equal to 6 months as on balance sheet date, then reporting will come into the picture. Imagine January due not should be paid in the month of February. GST, okay, not paid in the month of February. Outstanding, yes, but as on 31st March, is it more than 6 months? No, even though it is undisputed, as on 31st March, it is not more than 6 months. Therefore, I will not report that. Now, May month should be paid in June, not paid. Clear? May month not paid in the month of June. As on 31st March, it is still unpaid. Is it more than 6 months? Yes. Therefore, I will report it. Clear? So, undisputed reporting will happen only if the outstanding period is more than 6 months. Clear? If it is less than or equal to 6 months also, we will not report. They have told for a period of more than 6 months, you are supposed to report. If it is equal to also, I will not report. Okay. In case of disputed dues, what we should report, sir? Amount involved and forum where the dispute is pending shall be mentioned. Theoretically. Practically, it is not this. We will tell the years also, which is the year which is due, under which act it is payable, how much is the amount and where is it due. These four information we give. But Caro mentions only two, amount and forum. Boss, amount and forum you will tell. Imagine I tell you 300 crores, High Court. As a user, will you understand what is this 300 crores? It is income tax, custom, sales tax, excise, what it is. So we have to report under, in guidance note how they have given is, you have to report amount also, forum also, act also you tell me, and for how long it is pending. Okay. Next, undisclosed income. Imagine you earned a very good income long back, but you said, my life, my rules, why should I declare in the income tax? Clear? You did not declare, but later on income tax came and told. Now, in one of the cities, no, traffic police came up with the law. All pending challans is there, no, 50% discount. Okay. So, literally, in checkposts, no, they have a camp. You can go, tell this is my pending challan, right? Imagine 1,000 rupees for no parking, some challan has raised, you have not paid. You pay 500 and close it. Clear? So like that they'll come up with schemes. Okay, my father paid 2 tickets, and which is not ours also. On our car it has been they have registered it, no photo only. Clear? When I asked my dad, why did you pay, he's like, it's okay, no problem, I don't want problems tomorrow. Clear? So in such cases, so they come up with schemes. Income tax also came up with scheme saying whatever undisclosed income is there, disclose it with us, give our cut, we will not ask you any questions. Clear? And in that particular scheme, if you have gone and disclosed, imagine 2010, you have earned very good one, let's say 10 crore rupees income. You never disclosed it. In 2025-26 financial year, you came and disclosed to the income tax saying this 10 crore. Imagine you paid tax. Now you declared with the income tax. That means, don't you think you accepted it as your income? Therefore, don't you think it should be recorded in the books of accounts? Yes. Which year I will record now? The year you declared, which is that year? Financial year 25-26. In the current year, I will disclose it as other income, and in P&L, you have to show it as PPI, prior period items. Clear? Now that is what they're telling. Where transactions not recorded in the books of accounts have been surrendered or disclosed as income during the year in the tax assessment. If yes, whether previously unrecorded income has been properly recorded during the year. So in the current year, it must be recorded. Clear? Next, repayment of loans. Now this loans is not statutory due. These are other dues from individual, etc. If you have taken those dues, we are talking about. Whether the company has defaulted in repayment of loans, borrowings, or in the payment of interest to any lender here, even for an individual, if you have made a default, it has to be reported. What should I report? Period and amount of default. How should I report? In the following format. What is that? Nature of borrowing, debenture, hand loan, demand loan, what it is. Name of the lender, A for Ambika, B for Bhanumati, C for Chitra, whichever lender you have taken amount from. Amount not paid on due date. What is the outstanding amount? Whether it is principal or interest, and what is the number of days of delay. Then, sir, have you declared as willful defaulter by any bank, FI, or any other lender? What is willful defaulter means? You have money, you will not pay. Clear? You will have committed default in India, you go and sit in London. Clear? Now, after some years, you realize you come and give podcast and say, I don't own anything. Clear? Now the question is, you have been flagged as a willful defaulter by bank. Does that mean you don't have money? If you don't have money, how are you living your life in London? You have money, you don't want to pay. In that case, we'll call you as willful defaulter. So bank will call you as willful defaulter and submit you to RBI. Clear? RBI prepares a consolidated list of willful defaulter. You won't be allowed to do business in India. Clear? That is the reason why they don't do business in India. Okay? They do business outside India because you're not allowed to do business in India. Clear? Then, you have taken term loan, but you have applied for term loan means what? There are some fixed period. So, term loan were applied for the purposes for which loans were obtained. If not, where have you put that money and why have you put that money? Imagine I have told bank, give me 10 years loan. I am constructing one building and I took that loan, put that money into working capital. Wrong. Clear? Wrong, bro. Very, very wrong. Therefore, what you should do, you should first report you have taken loan and applied for some other purpose. Clear? Next, whether funds raised on short-term basis have been utilized for. Why should I report this? Because short-term funds are very expensive than long-term funds. And if you put it in the long-term purpose, your funds are blocked. If your funds are blocked, you will end up paying more interest. Profits will reduce. Clear? This is one of the ways of escaping dividends and tax. Nice, no? We will take short-term loan, 20% interest per annum versus 9% interest per annum. Put it in long-term. Funds are blocked. No problem, sir. We have enough money to pay interest, but people will not get dividend. And dividend is not there. Profits are also not there. Therefore, tax is not there. Clear? But we are getting our job done. Okay? Then, whether company has taken any funds to meet obligation of subsidiaries, associates or JVs. Sir, if a father has taken loan for your education, whose loan it is? Father's loan only from bank's perspective. It may be applied for you, but it will be shown in their balance sheet. So holding company has taken loan for subsidiary. I'll have to report to the user because the holding company's user should know these are not our loans. These are for subsidiaries, associates or JVs. Loans raised during the year on the pledge of securities, I'll have to report. This is called pledging your securities and then taking loan. High risk transaction. Tomorrow you don't repay. Banks or lenders will start taking charge on the shares. They will take up decision. They will become the members. One of the biggest red flag in a company. Clear? If you are taking money by giving shares or your securities. Public money. You have taken money from public by telling one purpose, gone and applied for some other purpose I am supposed to report. Whether money raised by way of IPO, FPO during the year were applied for purposes for which those are raised. If not, give the details together with the delays or default and subsequent rectification. You have taken money for one purpose, gone and put it for other purposes, not allowed. Next, in case of preferential allotment or private placement of shares or debentures if you have given, then we should also see have you given such actual amount? If yes, whether requirements of section 42 and 62 has been met. If you are giving private placement, section number 42. If you are going for preferential allotment, section number 62. You have to comply with it. If you have not complied, then I'll have to report. What I have to report? Funds raised have been used for the purpose for which funds were raised. If not, provide details of amount involved and nature of non-compliance. So both I need to report. Fraud reporting. In case of fraud, section 143, subsection 12, read with rule number 13, talks about less than or equal to 1 crore. I need not report. More than 1 crore, I am supposed to report to central government. Clear? That have you reported properly or not is what I am supposed to report. Clear? So technically this is one of the clauses. This is one of the clauses I should report about myself. Because who is the CA? I am the CA. Who is doing CARO? I am doing CARO. Who is supposed to give under section 143.12? I am supposed to give the report. So I should report about myself telling whether have I reported to government or not if I have found any fraud. Clear? Section 143.12 tells less than or equal to 1 crore means you don't have to tell CG. More than 1 crore means you should tell CG. Clear? Next is Nidhi companies. In case of Nidhi companies, you have to maintain, see Nidhi companies like a very small type of company for their own people, they run like one bank. All will come and contribute something to the company and they can take loan from the company. So basically Nidhi companies promote savings and your habit of savings. So for that, I need to see whether your ratio is good or not. What is the ratio? Net owned funds to deposit ratio should be 1:20 to meet out the liability. Meaning net owned funds means what? 1 rupee capital if you are having, you are allowed to take maximum of 20 rupee deposits, not more than that. That's 1:20. Clear? Why? We need to check whether you are exceeding 20 or not. If you are exceeding 20, I'll have to report. Then, have you maintained 10% unencumbered term deposit, meaning FD? You have to maintain FD of minimum 10% of the outstanding amount. Reason being is, this should be unencumbered. Unencumbered means what? This FD you cannot give as a security to anyone else. No one can touch this. Clear? No one can touch this. That type of FD you have to create. Why? For Nidhi companies members, you have to give their money back. Clear? In case if you don't have capital, at least 10% FD is there, no? That at least we will give. Whether there has been any default in payment of interest on deposit or repayment, if yes, give the details. Now this is what I am talking. These details, where have they told? CARO has not told you the format. Therefore, we will go to guidance note. Okay. Next is RP, related party transaction. In case of related party transaction, whether all the transactions with RP are in compliance with section 177 and 188 of Companies Act wherever applicable. 177 talks about Audit Committee, 188 talks about RPT. Okay, so whenever you do RPT, you have to go through Audit Committee. They have to approve it. So have you gone through two sections, 177 and 188? Then internal audit, whether the company has internal audit system according to the size and nature of the business. Size of the business, section number 138 has told you. Clear? For which company internal audit is applicable? Listed company, unlisted public company, private company. Unlisted public company, turnover 200 crore, more than or equal to 200 crore, or loans more than or equal to 100 crore, or paid up capital more than or equal to 50 crore, or deposit more than or equal to 25 crore. Any one condition you satisfy, you need to have internal audit system. Number one. Number two, if you are a private company, turnover of more than or equal to 200 crore, loans more than or equal to 100 crore must be there. And if that is the one condition you satisfy, you need to have internal audit department. Okay. Now, what I should see, have I considered the report of internal auditor while I am giving my report? If yes, I need to report about myself. Have I considered their report or not? In audit, we have SA 610 talking about this. Okay. Non-cash transactions with the directors. Now, what do you mean by non-cash transactions with the directors? Director and company will have transaction saying, I will give you something, you give me something. Now, what is that something? I will give you my services. In return, you give me something in return, not but cash. Furniture, possible. Bonus in shares, possible. Promoters, they can do that. Clear? So, in such cases, non-cash transaction, is it wrong, sir? No, it is not wrong, provided you follow section number 192. Section 192 you follow, then we are okay with it. Okay. Next is RBI registration. This is generally for NBFCs, clear, or HFCs, finance companies. Whether the company is required to be registered under section 45 IA of RBI, and have you taken the registration? Clear. Then, whether the company has conducted any non-banking financial or housing finance activity without valid certificate of registration. Sir, what do you mean by that? Having registration is not important. Having valid registration is important. What if you are doing business with the expired certificate? Possible? No. You can drive the car with an expired license. Why not run a company with expired license? So if you are doing that, I need to report. Clear? Then next subclause, if you are a core investment company, are you meeting the criteria of core investment company? What is core investment company? Where the business of this company is only investment in securities of other companies. Clear? Example, criteria there are a lot, but one of the criteria is 90% of your net assets should be in form of investment. That is one of the criteria we see. And if such companies are there, I need to mention it under this clause, whether it is continuing to be core investment company or not. And if the group of company has more than one CIC, mention how many CICs are there. Example, Reliance Group of Industries, they may have three CICs. I have to mention 3. ITC group of companies may have 5 CICs. I should mention here 5. Clear? Okay, sir. Next is 17th clause, that is cash loss. Just now we saw in NDTV. What is cash loss concept? Reporting, yes, whether you have incurred cash loss in the current financial year and preceding financial year, I have to report. But what is the logic here? What do you mean by cash loss? Very simple. Whatever loss you show in P&L is not the actual loss of a company. Clear? Because the P&L has two types of elements. One is called cash element, one is called non-cash element. We need to eliminate non-cash element and then actually see whether you have actually suffering loss or not. So we need to see cash loss here and not P&L loss. Provision is definitely not an expense, although we are not spending on it. Depreciation is not a cash expense. So when we add back these, we will get to know whether the company has actually suffered loss or not. Imagine company has suffered 100 rupee loss, net profit. net loss in the P&L. With that, they have debited depreciation of 150 and they have created provision of 25. So after reducing this, they are suffering 100 rupee loss. Actually, are they suffering 100 rupee loss? No. This is minus, no, add back depreciation, minus 100 plus 150 plus 25. What is the amount? Profit, no. Cash profit. They have not lost money, they have money. Just to see whether amount is actually lost or not, we follow this particular method. If you have incurred cash loss, mention it. If you have not incurred cash loss, mention clearly not incurred cash loss. Resignation of statutory auditors. Now, what do you mean by this? A statutory auditor resignation is a small thing or big thing? Sir, we take attempts to clear. That much pressure we go through, that much stress we go through. You think we resign? No. But if you are resigning, that means something is very serious. So, in case if you have resigned, whether there has been any resignation, if yes, have you taken into consideration the excess issues, objections, concerns raised by outgoing, like for example, restriction on scope, fees not paid on time, integrity of the management is not there, whatever objections they have raised, have you considered or not? Next clause is financial asset and financial liabilities. This is specifically talking about solvency. Whether the company is solvent or not. Clear? Now, if you are solvent, how do I know whether you are a solvent? Based on your assets. What is solvency means? Ability to repay your liabilities. So, I have to report here based on your assets. Do you have the ability to repay your liability as and when they fall due in the next 12 months? I repeat, what should I report here? Based on your assets details, based on your plan, based on your information that you are giving to me, do you have the capability to meet the liability as and when they fall due in the next 1 year? This I should tell as on the audit report date. Only then the users will get confidence that, okay, we have enough assets to repay the liability. But mind you, as and when they fall due in the next 1 year, sir, there is a loan which is repayable after 10 years. I will not be bothered about it now. But if there is any loan which, in case if it is due in the next 3 months or next 4 months or within the next 12 months, do you have the capability to repay those loans, not the long-term loans? That is what I am supposed to tell. Every year I should see this. Understood? Clear? Okay. So check on the basis of ratios, aging of financial asset, realization of financial asset and payment of liabilities, any other information accompanying the financial statements and my knowledge of board of directors and management plans. I should report whether I am of the opinion that no material uncertainty exists when, as on the date of audit report, that company is capable of meeting its liability. Which liability? Which they have at the balance sheet date as and when they fall due within a period of 1 year from the balance sheet date. Meaning, imagine financial year 25-26. Now here there is 100 CR loan. Okay. Now in the month of April 26, again 10 CR loan they have borrowed. Right. Now, imagine in the month of June 26, I am going to give my audit report. So I should tell in the month of June 26, in that audit report date, I should tell whether the company is able to pay 100 crore loan and not 110. Because this 10 crore was borrowed when? Next financial year. So this is not bothering me. I should tell whether they are able to pay 100 crore loan. Out of that 100 crore loan, if any loan falls due from April 26 to March 27, the company will be able to repay, and this repayment is based on the assets which the company has. Understood? Clear? Any doubts in this clause? Very important to understand this. I repeat again, based on the asset information plan given by the management, I should tell as on the audit report date whether the company has the ability to repay the liabilities. Which liabilities? As on balance sheet date. Now, when I should pay that, as and when it becomes due within the next 12 months. 12 months from where? Balance sheet date. This we have to tell on audit report date. Clear? We should tell as on audit report that from the balance sheet date for the next 1 year, the company is able to repay. Clear? Not entire 100 crores. Out of that 100 crore, whichever liability falls due within the next 1 year, I am able to repay. Got it? Now, last clause, that is CSR expenditure. Now, when we talk about CSR expenditure, what is the minimum expenditure that you have to spend on CSR? 2% of what?
Past 3 years average profit.
Past 3 years average profit. Profit before tax or after tax? Profit before tax. Now, you have to take PBT of last 3 years, average it out into 2% is your minimum. Now, the question is, if you don't spend, what will happen? Previously, there was no penalty as such. Clear? Now, if you don't spend, it depends now. Clear? So, let me draw a chart for it. Now, section number 135 says CSR minimum 2% of average net profit before tax of 3 years. Clear? Now, there are two outcomes of this. One, you are spending it. One, you are not spending it. If you are spending it, good, well and good, no problems. If you are not spending it, I need to ask two more questions. Is this with respect to ongoing projects or other case? Now, what do I mean by ongoing project? Sir, I am building a school, I am building a hospital, I am building a playground, I am doing something for the society. It doesn't happen in 1 year. It can take more than 1 year. Clear? Now, the question is, when these things happen, CSR is allowed. So, law says ongoing project means maximum it should take 3 years. Not more than 3 years. If you're saying 5 years, 6 years, no, I'll not consider it as ongoing project. It is default only. Maximum 3 years. If it is ongoing projects, then transfer that amount. Transfer the amount which you have not spent to a special account called unspent CSR account. Clear? Unspent CSR account. But if it is other case, transfer the amount to Schedule 7 fund. Transfer the amount to which fund? Schedule 7 fund. PM Cares, National Relief, Flood Relief, Clean Ganga Fund, Swachh Bharat Fund, put it there, government will take care for you, CSR is done. Clear? Now, there is a due date for it. Under 135, they have given respective due date. One is 6 months and one is 30 days. Clear? Unspent CSR, you know it is ongoing project. That means 30 days will be given to you. Otherwise, it is 6 months. For Schedule 7, it is 6 months. Then, whether in respect of other than ongoing projects, the company transferred unspent amount to a fund specified in Schedule 7 within a period of 6 months from the expiry of financial year. Clear? Number 2, whether any amount remaining unspent with respect to ongoing project should be transferred to a special account within 30 days. And what is a special account called as? Unspent CSR account. Clear? This is called as unspent CSR account. Now let me put a trap in front of you. Good question. Tell me one thing. In other case, when should I transfer it? To Schedule 7. When should I transfer it? Within 6 months from financial year expiry. Correct? Think and tell me, when will I give my audit report? Financial year ends on 31st March. 6 months from the end of financial year means 30th September. Correct? My audit report will be before that only, no? Yes. Now imagine my audit report is on 30th 6. And on 30th 6, I should say whether they have transferred the money to Schedule 7 within 30th September.
Next year.
Next year only we are giving, no. Now, financial year 25-26. Financial year 25-26 is a question now. So, we are auditing which year? FY 25-26. Correct? This year you should have spent.
Which year we should have spent 24-25.
No. You are taking the average of previous 3 years to be spent in the current year. How much we should spend, that depends on the last 3 years average. Clear? So either financial year 25-26 you should have spent here somewhere. If you have not spent here, that means either it is ongoing project or not ongoing project. If it is ongoing project, directly will transfer to unspent CSR account. If it is ongoing, not ongoing project, then Schedule 7 fund. But what is the due date for Schedule 7? 30th September. We are giving audit report on 30th June. Don't you think there is a gap between me giving report and they transferring the amount? In this case, what to do? In this case, when they say no, they'll have to clearly say the due date is not yet expired and ask the company whether they're going to transfer it or not. Based on that, we will report accordingly. Got it? Understood? Clear? So basically, whatever year we are going to audit, with respect to that year CSR, if it is not yet paid, then reporting will come into the picture. Whichever year you take, no problem for me. Clear? Any year, that particular year's CSR, I am auditing financial year 25-26. If that year ka CSR is not spent, I need to report. Now I need to ask the company, why have you not spent? If they are saying because we are constructing one building, then transfer it to unspent CSR separate bank account. Clear? If it is not other than ongoing project, then transfer it to the government fund. But the due dates are little different. Here within 30th April I should transfer. Clear? Whereas in case of other than ongoing project, it is 30th September we have to transfer. In case if you are giving audit report before that, then you can't report whether they have spent it or, whether they have transferred it or not. Yes.
For example, if they paid on 30th.
Okay.
38, then will it be reflecting on the next year's audit report?
Next year's audit report, it will not reflect on next year's audit report because next year audit report will be talking about that year CSR. So in the current year audit report, we will tell them that the company or based on the written representation or whatever it is, the company has told that they will be transferring before the due date. So as on audit report date, we are not able to get a comment on it. Clear? So only if there is a negative thing, we'll be reporting it. Got it? Understood? Yes, that is with respect to your CSR. Clause number 21, we have already discussed with respect to this. Yes or no? Yes, sir. With that, we are done with Caro 2020. So, we will take a 15-minute break and then we will do a branch audit and finish. 5:30 pakka. Okay? Right. Good. Right. Let's start with branch audit. Branch audit talks about SA 600. Now in SA 600 we need to discuss with respect to only branch audit concept, but that doesn't mean SA 600 is only for branch audit. SA 600 is, the name is what? Using the work of another auditor. Now in this using the work of another auditor, what are we going to discuss? Who is this another auditor, sir? We call him as a component auditor. Okay. What do you call him? Component auditor. And in this component auditor, component means what? Component means subsidiary, joint ventures, associate, branch, department, everything will come under component. So when you appoint a separate auditor for branch, department, subsidiary, etc., we call him component auditor. But in SA 600, we call him other auditor. Alright. Now when we are in CA intermediate syllabus perspective, we are only talking with respect to branch auditor. Rest everything here, yes, subsidiary, joint venture, associate, department, we are not going to talk about it here. Only and only branch. So what will happen, sir? Now this is me who is a principal auditor. Now if I have to give report to my client may have multiple branches. Now, for example, let's say ArivuPro has 4 branches and I am the CA of ArivuPro, and in Bangalore I am situated, and ArivuPro's main office I am handling. Now, Chennai Coimbatore I am not going to audit them. So, if I am not auditing, that doesn't mean I should not give report. No, I am supposed to give report. So, what I will do in case of branch audit is, I will tell ArivuPro that I am not going to do the audit of Coimbatore and Chennai. So, what ArivuPro will do, they will appoint one separate CA for Chennai, separate CA for Coimbatore, or one person for both. Now, what will happen? Let's assume one person for both they have appointed. Now, he will work based on Coimbatore information and Chennai information. He will prepare a report, right? Now, we have a component article, let's say, for example, CA Rajat. Alright, now he's a branch auditor, but we call him as other auditor. Now he should audit, right, as per the requirement and prepare the report and forward it to me, and I am supposed to use it. Understood? Now the question is, you tell me he is supposed to prepare the report and give it to me. When should I talk to him? After the report or after the work or before the work? Always prevention is better than cure. So we'll talk to him before the work only. Now in this case, we need to first talk only about this guy. If you see, we are not at all talking about principal auditor. We'll be only talking about branch auditor. Now this fellows, what is the qualification, sir? Let's see if the branch is in India or abroad. If the branch is in India, what is his qualification? He should be qualified under section 139. Or only principal auditor only can go and do the audit. If the branch is abroad, then principal auditor can do the audit, accountant can do the audit, or anyone who is qualified as per their law. For example, CPA. In US, our degree is not worth there, so you have to do CPA there, right? Or in some of the cases, maybe CA wherever is not accepted, ACCA is accepted, then you have to appoint ACCA there. So according to their laws, whoever is the qualified person. Now, what we should see in the exam, this is what is important. Roles and responsibilities as per SA 600. What I should do, either I can visit the branch, I can go and visit the branch, or I can rely on other auditors' work unless there is a special circumstances for me to visit. So I have two options. Either I only can go and visit, or I can rely on CA Rajat's work. Now he'll prepare and give it to me, but while preparation only I should tell what do I want. Because at the end of the day, it is my report that is going to get to the users and not CA Rajat's report. CA Rajat's report is only for me and management. But for users, whose report will go? Principal auditor's report. So either I can visit the branch to get to know, or what I can do, rely on other auditors' work unless there is a special circumstances for PA to visit and check the BOA. Clear? Number one, PA should perform procedures to obtain SAI. About what? The work of OA, whether it is adequate or not. Hey, am I doubting the other auditor? Am I doubting the OA? No, I am not doubting the OA. I am just checking whether his work is enough for me or not. Clear? Technically, I should go and work, but I am supposed to check whether his work is enough for me or not. Okay. Now, for that, which procedure I should perform? Audit procedure. What is the first procedure I will perform? Advise OA the use of his work. Clear? Advise OA the use of his work. So I should tell him, see, for example, if I tell you, imagine I'll tell Hari, whatever notes you're preparing, I'll be using it in my marathon class. If I tell him, will he not prepare his notes properly? Will he not prepare his notes properly? Compared to, I will just tell him prepare the notes. In which situation he'll be more serious? First, where I'm telling him I'll be using his work. Same logic here, I should advise OA the use of his work. Got it? If I tell the use of his work, he'll be more cautious when he does the audit. Then make arrangements for coordination at the planning stage itself. Meaning what? During the planning stage, I'll make arrangements for meeting. I'll go and meet him once in a week. Clear? And I'll tell him, see, this plan is not working, so plan it accordingly. Plan properly. So at planning stage only, I will go and meet him. Number one. Number three, inform him regarding special considerations, because you all know it. In branch accounts, if you had studied properly, there is head office and branch transactions. Clear? Head office may send cost plus markup to the branch. Clear? Branch may send it to head office cost plus markup. Now, how can you have a profits in a family? Clear? I can't say that I am doing, let's say, for example, garment business. I sold all my shirts to my father and I made profits. Boss, at the end of the day, it is family income. How can I make profit when I sell it to my own father? Not possible. So I should tell him, see boss, the branch and head office, they may have certain special transaction. Be careful with respect to that. I should educate him, whom? CA Rajat. Reason being is, I have more experience in head office, so I know what transactions are happening. So I should go and inform him about it. Okay. Intercomponent transaction is the example. Timetable for completion I should give him. Otherwise, what if he takes his own time? Clear? So I need to give him within, I should tell him, see boss, you only have 7 days. Within 7 days, you're supposed to give me your report. So I will take that report and then build my report on that. Clear? Advise OA about requirements and obtain representation. Which requirements? Accounting, auditing and reporting requirements. Because he should not report according to what he wants. He should report according to what I want. Because at the end of the day, I am using that report in my work. So I should tell Hari, see, you don't do whatever you want. In this, you have to follow this type of Ind AS. This only Ind AS requirement you have to check. Auditing requirement, I should tell him, see, I want you to check only these areas. So he will check according to that and prepare a report and give. And obtain representation. Obviously in writing. In written form only, we take the representation. Clear? So for understanding purpose, for remembrance purpose, remember this. This is the mnemonic. PA will cast OA. PA will cast OA. C for what? Coordination. A square, advice, and here also advice. S for special consideration and T for timetable. Clear? Now, I should discuss with the other auditor about 3 things. What is the procedure he has applied, or review the written summary of his procedure and findings. Sir, I should first discuss with him, what is the procedure you have applied? Tell me. Now he is telling, I don't understand whatever he is telling. What can I do? You do one thing, don't tell me, give me the notes. Clear? Review his summary or procedures and findings. Sir, his notes also I am not able to understand. No problem. Go to him only. I am not saying here, be careful, not visiting the branch. I am visiting him, other auditor. I can go to his office and get to know more. Okay. Now, logically you tell me, if branch auditor's competence is less, if CA Rajat is less competent, my work will be more or my work will be less? My work will be more. If CA Rajat's competence is good, my work will be less or more? Less. So can I say there is an inverse relationship between the principal auditor and other auditor? If OA's competence is more, my work will be less. If OA's competence is less, my work will be more. Clear? Now my question to you, how will I get to know his competence? Whether it is more or not, how will I get to know? Previously he would have worked, no? Previous audit experiments or any engagements if he has done, go and talk about it. Go and read about his other reports. That is how I get to know. For example, when you took up admission in ArivuPro, directly you took admission or you got the knowledge from multiple sources? You would have taken that knowledge from multiple sources and then you would have taken the decision. Understood? Clear? That is what we call as branch audit report here. So he will prepare and give it to us. We will have to take that into consideration and go ahead. Clear? So if OA's competence is more, PA's procedure will be less. If OA's competence is less, PA's procedure will be more. So how will I get the knowledge? Review OA's work in previous engagement. Clear? Rashid sir joined. Rashid sir joined my marathon because he wants to learn audit. Hi Rashid sir. Next, this is with respect to our SA 600. Fine. I'll give you your example next. Right? That is your SA 600 topic. Next, we'll move on to the next topic called as joint audit. Right? Now here, SA 299 talks about what? Joint audit, right? Now let's talk more about joint audit. We have main auditor. Now here, what do you mean by joint audit? Not the joint you're thinking. Yeah. What joint audit we are talking about here? When two or more auditors come together and audit one entity is what we call as joint audit. Understood? Clear? Yes, sir. Therefore, we need to understand Reliance, ITC, Tata. When the organizations are very huge, the transactions will be big. Therefore, we need to audit them. Correct or not? We need more than one CA because one CA cannot handle everything. Clear? So Rashid sir alone cannot handle everything. So he wants more than one CA to handle the entire joint, it seems. No, to audit the entire organization. Clear? So we have, let's say for example, now joint audit can be between two individuals, right? You can appoint individual, or you can appoint firm and individual, or firm and firm. Any combination is okay. So CA Karthik and Associates, one firm is there. Clear? Then we have one more CA called CA Rajat. We will cancel this. We'll call it CA Rashtrath. Okay. And then we have CA Sudeep and Co. So there are two firms and there is one individual. Clear? These will audit a bigger company called Loose Tools Limited. Clear? Imagine the turnover is 10 lakh crore. Okay, 10 lakh crore. So we will audit the financial statements together of one company. The logic here is one person cannot handle such a big transaction and give a report within a due date. Clear? Now what we need to see here, meaning of joint audit is very simple. Pooling together what? The resources and expertise of more than one firm of auditors to render an expert job in given time period, which may be difficult to accomplish acting individually. So alone I won't be able to get that particular work done. Therefore I require more. Clear? Then advantages and disadvantages we'll have to talk. Now this was asked in May 25 question. Advantages of joint auditor or disadvantages of joint auditor. What is the advantages? Sharing of expertise. Advantage of mutual consultation. If you have any problem, we can talk it out. Lower workload. Quality of performance will be better. Improved services to the client because everyone is expert here. Clear? In respect of MNC, local firms we can appoint and get our job done. Lower staff development cost. What is staff development cost? Sir, rather than what is the other option if I don't appoint a CA? I need to appoint an employee, train him, clear, spend so much energy, time, money on him, then he will leave me. That much better than that we'll appoint an expert only. He'll get the job done. Lower cost to carry out the work. Professionals will make it, finish the work more faster than non-professional. Therefore, cost to carry out the work will be less. Healthy competition towards the better performance. Meaning what? Sir, two firms when they're competing with each other, competition will be much better. What are the disadvantages? Fees being shared, psychological problems between the firms, superiority complex, coordination, all this because of psychological problem. You are senior, I am junior, clear, you know better than me, I know better than you. That type of psychological problem when it comes, complexity will come. I am superior, you are inferior. Yes, then I will not work with you, coordination problem will come. Areas of common concern being neglected, you will be like, I am an expert. I will not do such job and all. Clear? Who am I? I am a CA. So common area will be neglected. Uncertainty about the liability of the work done. So whatever work you're doing, you don't know what you're liable for, which I don't agree with personally because right now the liability part is very clear. Clear? Section 147, NFRA, everyone has given a liability if you do not work properly. But there is one more advantage which I have not put here, right? It is there in the study material. That advantage is in case of a takeover. In case of a takeover, we need not leave the other CA. Now, how does it work, sir? Imagine there is A Limited. There is, we'll take Rashid sir's name. You shouldn't feel bad. We have Rashid Limited and he loves patriotism. So therefore, let's say Soldier Limited is there. Okay. Now, imagine Rashid Limited CA Rashtrath. Soldier Limited CA Soldier.
No.
Now, in this case, what generally happens, let us say Rashtric Limited acquired Soldier Limited. Clear? So, amalgamation happened. Clear? Now, the question is, in case of the amalgamated company called Rashtric Soldier Limited, who will become the CA? Should I appoint only CA Rashtric? Should I appoint only CA Soldier? The question is, if I appoint only Rashtric, it is, again, he'll have to work more because he doesn't know about Soldier Limited. If I only appoint CA Soldier, it'll be again difficult because he doesn't know about Rashtric Limited. Therefore, I'll appoint both. So, both come and do the audit of this amalgamated company. That's again an advantage. Clear? Next. If a joint auditor comes across a matter which requires discussion, disclosure or others' attention or any other judgment, you have to communicate to other JA in writing before completion. Sir, what do you mean by that? See, we are a team. When we are working as a team, imagine all of us are JAs. Now, Naveen got some information, but it is not his area. It is my area. Now, if it is not, even if it is not his area, don't you think he should come and communicate to me? He found something which is related to my area. We are working as a team and he thinks that this area requires more judgment. This area requires discussion from all of us. He should come and tell it to every one of us in writing. But when should he tell? Before completion of the work. You know why? If he sit quite simply saying it is not my area, sir, how does it matter? Whose audit is spoiled now? Everyone's audit is spoiled, right? So we should understand. Imagine in the kitchen, the vessel caught fire. Mom has told you don't come to the kitchen. Previous day she had told don't come to the kitchen. Next day the vessel caught fire. Mom is not there. What will you simply sit quiet in the room? Not my job now, sir. If you simply sit quiet in the room, what will happen tomorrow? Forget tomorrow. Next moment only what will happen? You cannot sit in home. Here you will have to find another home. That is what we are saying. Boss, even though it is not your area, but it requires others' attention, go and tell others that, sir, this is a matter. It's not my area, it's Karthik sir's area, but I think we all have to give an opinion here. Because when we are doing an accounts, can you tell me, books of accounts, tax separate, account separate, costing separate, can we do like that? No, one transaction will affect many places. Clear? So we are working as a team. If a JA comes to know any such matter, it is better you go and tell all other JA. How you should tell? In writing. When you should tell? Before completion of the audit. Okay. Now, what are the special considerations in carrying out JA? This is the only important part of SA 299 conceptually. Advantages and all for you. Very easy question. Clear? Now, engagement partner and other key members. I'll tell you one thing. When you're studying chapter number 2, only finish this off. This is much easier to finish. If you see all points are repeated. Engagement partner and other key members of the team should be involved in planning. Where is it given? Chapter number 2. Number 2. Jointly they should establish strategy which sets scope, timing and direction of audit and guides development of plan. Where is it given? Chapter 2. Third, they should develop a joint audit plan. Where do we develop plan? Chapter number 2. Then consider and assess ROMM and communicate to all other J's. Whichever risks each of us get to know, we should go and communicate it to everyone, because at the end of the day, we are giving only one report with everyone's sign on that. Clear? We can't be very negligent about it. Discuss and document the NTE of AP of common area and specific area. Meaning, imagine now, 3 people are there here. Karthik and Associates, Rashtric and Sudeep. Now, Karthik and Associates are good at audit and accounting part of it. Rashtric is good at taxation part of it. And let's say Sudeep and Co is good at the GST part of it. Clear? Now, everyone, if Sudeep gets to know any ROMM with respect to GST, come and tell it to others. Because it might affect sales. It might affect purchases. Yes. If Rashtric gets to know anything about the taxation part of it, come and tell everyone. Because it can affect our books of accounts also. Clear? So, you have to come and talk to everyone. Discuss and document. Document means what? Keep a record of what? NTE of audit procedures for common and specific areas. Obtain common engagement letter and common management representation letter, because we are working as one team. He can't give three engagement letter. Joint audit is one audit. Clear? See, it's like generally different cricketers will have different country, but when they comes to IPL, they play for same team. No, like that, same model. Clear? So one engagement letter we should get and one common management representation letter. Work allocation document should be signed by all JA. Why? Accountability. Tomorrow we will get to know who this person was and what was his responsibility and where he went wrong. So work allocation document must be signed by all JA, not just prepared. Document which is not signed will have less value than document which is signed. Then now point number 3 says you have to develop a joint audit plan. Now in exam, please be careful. If they ask you what are the special considerations, you have to write all points. But in the exam, if they ask you only with respect to joint audit plan, then you have to write this. While planning the joint audit, what are you supposed to do? Identify division of audit areas, meaning what is specialized area and what is common area. Not everyone is expert in everything. So give it to them respectively. Clear? Let's say for example, taxation Rashid sir you handle, accounts and audit Karthik sir you handle. So if you handle the GST part of it. So divide and give. Then there will be common area. Everyone has to comply with financial statements law. Everyone has to comply with audit reporting standards. That way we'll have to divide. Ascertain reporting objectives. Again same chapter number 2. In audit planning same thing is there. There identify characteristic and define scope. Here identify division of areas. There ascertain reporting objectives. Here also ascertain reporting objectives. There consider and communicate factors that are significant in directing team effort. Same point here. Copy paste. Clear? Results of preliminary engagement activities or other similar engagement activities performed earlier. Same point there. Point number 4. I'll show you. Ascertain NTE of resources necessary. Now, if you see this point and this point in chapter number 2, see, factors establishing for strategy. What is the first one? Identify characteristic and scope. Second, ascertain reporting objectives. What is there here? Ascertain reporting objectives. Third, factors significant in judgment should be considered to which will contribute to team's effort. Same point. Fourth point, consider results of engagement activities. Same point. Last point, ascertain NTE of resources. Same point. Moral of the story, joint audit is much easier. You know why? Because joint audit and normal audit is both are same. The only difference is in chapter 2 we learnt only from our perspective. We are only doing the audit. In joint audit, people like us, 2-3 people are there. Together we form as a team and do. So what we do in chapter 2 only will be repeated here. Only difference is there we say audit plan. Here we say joint audit plan. That's it. Points are same. Concepts are same. That is the reason why they focus on advantages and disadvantages. Because if they want to ask these type of points, no, they can ask in chapter number 2. That is the origin of that particular concept. Clear? Now, what is the liability? Generally, joint auditors are liable for the work given to them. But in exceptional situations, they are liable for everything. What are these exceptions, sir? Number 1, work which is not divided among them. If the work is not divided, everyone will be liable. Clear? For example, you tell me, if the work is not divided, who do I hold liable? I don't know who it is, therefore everyone will be liable. Decisions taken by all JA with respect to common areas. See, choices have consequences. You have taken a decision, you are liable for it. Matters brought to the notice of JA by any one of them. This is not the point. And there is an agreement on the same. Now, Naveen got to know some information, came and told to all of us. We didn't agree on it. If we have not agreed on it, no, then he will be liable. But if we all agree on it, now Naveen got to know something, he came and told us, sir, debtors is misstated, sir. Okay, don't worry, we'll handle it. Clear? And we forgot to handle it. Tomorrow, everyone will become liable. But there should be an agreement on the same. Clear? Then compliance of FS, everyone is liable because how many financial statements you give? One. Compliance of presentation and disclosure of financial statements, again everyone is liable. Why? How many FS? One. Therefore everyone will become liable. Compliance of report, how many reports we give? One. Therefore everyone will become liable. This is important. Jointly and severally liable is important. Now, how many reports we should give, sir? 3 joint auditors are there. How many reports we should give? If all are in the same page, then 1. But is there a possibility that everyone will agree to the same thing? Possible. But in case if there is a difference of opinion, because it is opinion, no, opinion cannot be forced out. So in case if there is a difference of opinion, then the CA who has difference of opinion, only for that matter he can give separate opinion. For all other matter he can give common opinion. So generally we give common one report only. If there is no disagreement, issue common report. If there is disagreement, express their opinion in a separate report and make a reference to each other. That is common and separate. Because now example, let's say I am there, Navin is there, Hari is there, Lakshman is there. Clear? We all of us are doing joint audit. Now Lakshman has a difference of opinion when it comes to provision of claims. We all have agreed that provision of claims are reasonable. Lakshman says, I don't consider it as reasonable, sir. So I will not give unmodified opinion on that. Now, we had 100 matters. In that 99 matters, that fellow is agreeing. One matter he is disagreeing. For that one matter, he should give separate report. And for the rest 99 matters, will be giving common report. In the common report, we will be mentioning with respect to provision of claims, CA Lakshman has a different opinion. It is referred in this report.
That will come at the basis of opinion.
Basis of opinion is a reason I will give. Clear? There I will tell how, on what basis we are giving an opinion. Since there is one disagreement, no, under that I can tell that for this matter, CA Lakshman has a different opinion, then we'll attach that particular reference report. But 99.99% no will come to a conclusion only. You know why? This confusion we have to avoid. Clear? One opinion separately will be giving 99 same opinion. Imagine users. They'll be more confused now. Now, if it is more confusion, who should solve that confusion? He only know. So, moral of the story, what we'll say? Okay, fine, sir. Consider it as reasonable. You know why? My company, huh? No. Whose company? Client's company. It's okay. No problem for us. So, we'll convince Lakshman to give common opinion. Clear? Now, I will go to Lakshman and tell, even I don't agree, da. It's okay. Clear? We'll finish it off. Right? So, that is how we convince in case if there is any problem. But nothing is stopping you from giving his opinion. He can give his opinion, I can give my opinion. Absolutely no issues. Clear? Yes. In this, 3 areas it is important. Number 1, now it is very scary to give important. You know why? I gave this also. They went and gave advantages question for 5 marks. I really don't consider advantages as your CA Inter question. Clear? Reporting is important. Liability is important. And special considerations is important. Right, this is your essay 299. So from this particular topic, we are done with CARO, branch audit and joint audit. Understood? So in audit report, we have essay 700 series and we have section 143. In that only selective 143 will be doing, that is reporting of frauds and internal financial control part and audit trail part. Clear? Yes. And then we'll be continuing with the reporting standards. So tomorrow, first thing we'll be doing is reporting standards. Clear? Cool. Thank you so much. Have a wonderful evening. Yes, can you hear me? Online? Is audio good? Okay. Let's begin with the audit report chapter. All the standards we'll have to finish soon. We will be covering under this particular chapter, we'll be covering essay 700, 705, 701, 706 and 710. Okay. And right after this, we'll be doing with respect to chapter number 7, that is the completion and review standards. Okay. Essay 700 talks about forming an opinion and reporting on the financial statements. Now, this particular standard is where we end our audit with, right? So, whenever we want to give an opinion, like I said, we have 2 types of opinion, unmodified and modified opinion. And unmodified opinion means what? Financial statements are free from material misstatements, and modified opinion means financial statements are not free from material misstatements. Now, these are the things that we have to understand. Number one. Number two, whenever we want to give unmodified opinion or modified opinion, we cannot give in the format that we want to give. Therefore, SA 700 itself fixes the format. No one can change this particular format. Every CA has to follow this particular format. Now, before we give an report under this standard, what is the objective of the auditor? As usual, now like I already said, every concept starts with an objective and ends with an objective. Similarly, our audit starts with an objective, ends with an objective. Our objective to start the audit was to obtain reasonable assurance and to report. Same logic here, to form an opinion whether financial statements based on the evaluation and the conclusion drawn. Therefore, if you remember the definition of audit, it ends with opinion, and therefore here also we are ending our audit with opinion, and to obtain reasonable assurance at the end of the day. So same logic or objectives of SA 200 will be the objective of SA 700. The only thing is in SA 700 we execute that particular objective. Whenever we are concluding that, if you remember the audit cycle also, we put the procedures, we get the evidence, we draw the conclusion, and we give the opinion. When we are giving the conclusion, I told you we have to evaluate the conclusion and give the opinion. That evaluation of conclusion is what type of conclusion? Whether SAI has been obtained or not. Number one. Number two, whether uncorrected misstatements are material, whether individually or in aggregate. Now, this technically you'll have to study after your chapter number 7, if you're doing the first 2 rounds of studies. Since it is revision, I can take it any point of time. Now, because this is your SA 500 topic and this is your SA 450 topic, evaluation of misstatements. Only after those 2 standards you'll understand why we are talking about conclusion here. And third one, specific evaluation we'll have to do. These specific evaluation is what we are going to discuss under this particular heading. My next objective is to express clearly the opinion through a written report, and this is my SA 200 second objective, and this is my SA 200 first objective, chapter number 1. What is the evaluation I should make? Now, these are called as qualitative aspects of our financial statements we'll have to evaluate, and then we have specific evaluations to be done. Number 1, when we say qualitative aspect, what qualitative aspects are? Whether amounts and disclosure in the FS are properly given or not. Now, this particular thing, disclosure, is totally with respect to quality matter. See, if the standard says disclose like this, like this, like this, it is easy for us. But when we talk about true and fair view and not your compliance framework, when we are talking true and fair view, what is fair, what is unfair is totally subjective. Clear? Now that we'll have to evaluate keeping companies' financial statements in the mind, keeping companies' aspect in the mind, what do they want to communicate with their users. Second one is SA 260, which gives us the base where qualitative aspects of accounting practices we have already discussed. What is SA 260? Communication with the TCWG. So with the TCWG, we would have spoken certain qualitative aspect. There we will not go and tell that your coffee machine is not good, your employee is doing time pass with the secretary there. Those things and all will not tell to TCWG. To TCWG, what we will tell, whether your accounting policy is appropriate or not, whether your inventory valuation is appropriate or not, whether a depreciation method is appropriate or not. Such things is what we tell to TCWG. From that, with the TCWG, we may tell thousands of matter, but from that, we will have to pick what is qualitative and then we will have to put it in the financial statements. Now, I may become aware about some bias in management's judgment. Like, for example, when they make provisions, imagine now there is a, think of it an answer, there is a related party transaction, okay, sales, credit sales, there is a related party transaction where the company has made sales to their own parties. Now, 10 lakh worth of sales they have done. Generally, provision is created not more than 10% in the company according to their policy, but for this RPT specifically alone, they made a 35% provision. Now, where is 10% and where is 35% provision? Now, my question to the company is, if it is a related party, then you should not make provision also, no, because you should know who they are. You are making over and above your policy. Now, this can be a bias. What is the bias? That there could be a fraud involved in this? I do not know, but it is an indication that where you are telling not more than 10%, first of all, RPT you are doing, which is high risky transaction, and that too over and above, not arm's length price. Again, second indication of risk. Third, you are doing provision for more than 10%, which means gives me an indication that there could be a collusion between company and RPT. Therefore, it could be a transaction where they are selling it to RPT and telling the RPT, you become a bad debt in our book, we will increase the provision to 35%, you make the payment of 75% through bank and 25% in cash. Therefore, the provision which I made for 35%, now imagine 10 lakh rupees I have sold it. What is the provision I created? 35%. Right? Now 10 lakh into 65% is how much? 6 lakh 50,000. Make the payment. Clear? Make the payment of 6 lakh 50,000. The rest 3 lakh 50,000 you make in cash. And what I will show in my book, 10% provision, no. Yes, that 25% I will consider as bad debt. Or total 35% bad debt, but 10% is allowed. That rest 25% is there, no. I will eat up the money. Now, this transaction is an indication that something is seriously wrong in the company. Now, this is because of possible bias. So, I am not saying bias is there, but there could be possibility of bias. Don't worry, more about it. In the next level, you will be learning. SA 550 talks about possible bias in CA finals. Estimate, provisions, wherever we have to make estimates, assumptions, there could be a possible bias. Clear? Now you may conclude there is a lack of neutrality together with uncorrected misstatement will definitely be a high risky thing where financial statements are materially misstated. Two things. Lack of neutrality. What does lack of neutrality means? Bias. Basically bias. Imagine the bias attitude combined with uncorrected misstatements. That means financial statements definitely will be materially misstated. What are the indicators? Selective correction of misstatements. Sir, I told you 10 misstatements, you correct only 3 misstatements. That means you are selectively correcting the mistakes, which is not a good habit. Then possible management bias in making accounting estimates. SA 540 in the next level will give you better idea about it. Okay. What are the specific evaluation I am supposed to do? Number one, about your accounting policy, selection of accounting policy and application of accounting policy. Could be accrual, could be double entry system, could be your matching concept, could be depreciation method, could be inventory valuation, whether you have selected appropriate or not, whether you have applied appropriately or not. AS1 tells you, you can change accounting policy. Every year I am changing. It is inappropriate. Clear? Because only two reasons are there for you to change. One is requirement of law and one is better presentation. Every year because of better presentation I am changing. Very difficult for a user to understand whether you are making profit or not. Clear? Imagine 1 year depreciation SLM, 1 year depreciation WDV. Another year again SLM, another year again WDV. Users are confused what you are doing. Business is same. Capital is same, management is same, industry factors are same, but profit is differing year on year. That is wrong. Then whether whatever policies you have selected, is it consistent or not? Whether estimates that we have made are reasonable or not. I already told you, estimate cannot be accurate. Estimate will be either reasonable or unreasonable, keeping the situation in the mind. You cannot write it is accurate or not. It is correct or not. Estimate cannot be correct. Information presented is relevant, reliable, comparable and understandable. Meaning, if you are telling financial year 24-25, then you have to put financial year 24-25 information alone. Not next year, not previous year. That is exactly why next year amount, if you have paid in the current year, we will not show it as current year expense. We will show it as an advance. Right? Similarly, if there is any outstanding, then we will show it as a liability in the balance sheet because I am showing the relevant information and I should also show reliable information. Comparable in many financial statements, current year and previous year amount will be given to you so that you can compare and see whether there is increase or decrease. And understandable, basically disclosure, where I explain things why this particular amount is given in such a manner, contingencies, commitments, etc. Whether are you providing adequate disclosure of material transactions and events? For this example, if you want, you can go and check ITC's recent financial year 24-25 annual return you take. ITC got demerged. ITC hotel got demerged from ITC. It has to be disclosed in the financial statements because divorce doesn't happen every year. Clear? Of ITC hotel left ITC. It doesn't happen every year. Amalgamation doesn't happen every year. In fact, even internal reconstruction doesn't happen every year. But consolidation happens every year because consolidation is not transaction or event. It is a way of presenting the financial statements. That is why you do not have accounting for consolidation. It is a presentation method. Clear? So therefore, these amalgamation, demerger, internal reconstruction, all your concepts which you have learned in accounts, big concept, it doesn't happen every year. Generally, you know, internal reconstruction happens in your syllabus only in case of loss-making companies. But technically, it is not just for loss-making companies as per section 66. Clear? As per Companies Act section 66, it is not just for loss-making companies. It could be for a company where they have additional funds. Clear? Which is over and above that my requirement. I can still go for reduction of capital. Absolutely no issues. But in your accounting, they have only given you only loss-making companies. But practically, it is not just for loss-making companies. There are two other reasons. Technically, three reasons are there. One is loss. Clear? The other two reasons are, number one, where I want to extinguish the liability of my shareholders, I can do reduction. Number two is where I have excess money. Imagine I need only 1 crore, but users have given me 2 crores. That extra 1 crore, if I keep in my bank account, no. Number one, they will expect me to give that 20% returns, whatever they want, which I can't give because I'm not using that money. Number two, I am actually taking their opportunity away. If they keep in my SB, 4% interest they will get. But if I give that money back to them, they can invest wherever they want and make whatever returns they want. These are the other two reasons, totally three reasons why we go for reduction of capital. But in your account, it's only for loss. Reduction of capital is done. Clear? Yes. Then terminology used should be appropriate. What is the terminology used means? Sir, for debtor, we should say debtor only. For creditor, we should say creditor only. So whatever terms, words you have used, for example, contingencies and commitments, you have to give it to the right transaction, not random transactions. In the financial statements, whatever word, whatever terms that you are giving, it should be appropriate. Clear? Then, next, if financial statements are prepared as per fair presentation framework, there are two types of framework we will be talking about. One is called compliance framework. What do you mean by compliance framework? And one is called fair presentation framework. Now, let's talk about two framework here. Compliance means what? Compliance means what I told you only you should do. Nothing more than that. That is called compliance framework. You should not do anything above, you should not do anything below. That's called compliance framework. If law says you have to disclose only bad debts, then I will disclose only bad debts. I will not talk about anything else. Fair presentation goes one step ahead of compliance. This is where you will make mistake. Remember, compliance framework is whatever law says. Fair representation is compliance plus others. So others means what? Sir, law doesn't force me to disclose certain information, but I want to disclose it to my users. For example, imagine if law says you have to disclose the loss if you are making in the next quarter also. Let's say, for example, Q1 I made loss. Law says in Q2 also, if you feel you are making loss, then you have to disclose it now only. Now imagine, I know that for the next 3 quarters I'll be making loss. Not next just 1 quarter. For the next 3 quarters I'll be making loss. For me, I will take a decision. It is fair enough if I disclose to my users that next 3 quarters also I'll make loss. But loss is only 1. I am disclosing telling 3 quarters because I want to be disclosing to my users and I feel it is fair because their money is involved. I don't want to cheat them. I don't want to give them false hopes. But compliance framework person says we are not giving them false hope. We are just following what government is asking us to follow. That is called fair representation and compliance framework. Generally in India, companies follow fair representation as well as compliance, but compliance very less they will follow, fair representation more they will follow. So how do we know whether they are following compliance framework or fair representation? By reading the report of the auditor. If auditor uses the word called financial statement present true and fair view, that means they are following fair representation. But if the auditor says the financial statements are as per AFRF, that means they are following compliance framework. That is why if you see in audit report, generally both will be there. Clear? Because whenever you are using fair representation, you have to comply plus you have to do something more. So here, if you see true and fair view, they will also say as per AFRF. Both will be there. If both are there, then also it is fair representation only. But only if this is there, there is only compliance framework. Got it? Understood? Okay, sir. Next. So, in case of fair representation, see whether the overall presentation structure and content achieves fair representation or not. Now, general purpose framework and special purpose framework is there, but we are in your syllabus, it's only general purpose financial statements and GPFW. General purpose financial statement means what? Generally applicable for large number of users. Special purpose framework is not there in your syllabus, clear? But what is special purpose framework? Special purpose framework is for specific users. Example, banks. Example, investors, specific group of investors. Example, let's say for example, high net worth individuals wants to invest in my company, only for them. Now bank will tell, boss, I don't want your financial statements on accrual basis. Do one thing, go to your CA, prepare the FS on cash basis and get. Because I want to know your strength. I don't want to know your accrual strength, I want to know your cash strength. Go prepare it on cash basis and get. Now when I prepare it on cash basis, I'm giving to the bank. No, in my report I should tell this is specifically for bank alone and it's not for circulation. That is why you will not see special purpose financial statements outside. Because it is only for specific group of people. It is not for everyone else. Clear? So those type of financial statements are what we call as special purpose financial statements. And what type of framework we use? Special purpose framework. SA 800 deals with that, which is not there in your syllabus. General framework, SA 700 tells you how you are supposed to go about it. Okay. Then fair presentation we have spoken and compliance we have spoken. What is fair presentation? Beyond those specifically required by framework. In extremely rare circumstances, if you want, you can depart from the requirement to achieve fair representation. Extremely remote situation, not every time. But if you feel that, sir, law, whatever is saying is unfair, sir, I think I have to go beyond that. You can go beyond that because law says at the end of the day, you are putting public interest in front of law and I like it. I will allow you to do that. Yes, sir.
So in case of fair presentation, management chooses the framework.
Yes.
The auditor's job is to check whether the framework is followed or not.
Yes. Perfect. That's a thing which I put in my report, whether they have achieved fair presentation or not. Got it? Okay. Now, form of opinion already discussed, unmodified and modified. Two types of opinion are there. Unmodified, also called as, previously used to call it unqualified. This is the only place where if you say auditor has given me qualification, it is a negative thing. Clear? Qualification is generally a positive thing, but here it is a negative thing. Okay, if you are given qualified opinion, that means something is wrong. So right now, please, I plead you, don't go to the exam and write there are two types of opinion, unqualified and qualified. Your answer is wrong. It is unmodified and modified. Under modified, qualified is a type of opinion. Clear? So modified, there are three types of opinion: qualified, adverse and disclaimer. Okay? Right. When do we give modified opinion, sir? When you have evidence that financial statements are not free from material misstatements or you are unable to obtain SAI altogether. Only in these two scenarios will you modified, otherwise will give unmodified opinion. And which is our default opinion? Unmodified opinion. Now, what are the elements of report, sir? First is title. Title generally will be independent auditors report because we are independent, we are doing independent examination right from our definition. Addressee, whoever appointed you, to them you have to address it. For example, if government company has appointed you, if the central government company, address it to president, state government company, address it to governor. If it's shareholders, that means members. If it is partners, to partners. If it is proprietor, to proprietor. If it is society trust, to the trustee, board of trustees. Clear? Then next comes to my opinion. What is my opinion? Whether it is unmodified, modified, whatever is your opinion, you have to give it under this. But if you are giving unmodified opinion, wordings are important here. If you are giving unmodified opinion, your opinion para will only say opinion. And you should never write unmodified opinion. You know why? Because unmodified is our default opinion. That's why we'll never name it. Clear? But if you are changing your opinion, then you have to change the para name. If you are giving qualified, you have to write qualified opinion. If you are giving adverse, you have to write adverse opinion. If you are giving disclaimer, you have to write disclaimer of opinion. In regular classes, every opinion reports we have seen and read. Clear? That's why here I am not covering all those important reports. Clear? It is already covered. If you want, you see, Adani has qualified opinion. Everready also has modified opinion. Multiple we have seen. In fact, even unlisted companies also we had seen in the class. Okay. Now, basis for opinion. On what basis you are giving that above opinion? You are giving qualified correct, but what is your basis? You are giving adverse correct, but on what basis? You are giving disclaimer of opinion correct, but on what basis? Here you will give entire explanation of why are you giving such opinion. Clear? Now, here you should mention that you are conducting the audit as per essay and tell where is your responsibility section in the report. You have to mention you are independent of the entity and you have fulfilled your ethical responsibility as per requirements. Ethical requirements, that means integrity, professional competence and due care, professional behavior, confidentiality, objectivity, independence we have followed. Clear? Whether I believe that evidence what I obtained is providing me a proper basis or not. Without evidence, you should not talk anything in the report. Then, going concern. Next element is going concern. Sir, going concern you will never see in good companies. Reason, again, going concern is a default assumption that we are going to live for a foreseeable future. See, you have come to marathon because you believe that you are going to write JAN exam. Clear? You are studying because you are believing that there will be a day where I will become CA. It is not that we are living only today. Clear? Now that is the point, right? Going concern means a company believes that I will continue for a foreseeable future. It could be. Now, sir, my question is, what is foreseeable future? Let me cover the concept here only. What is foreseeable future means? Foreseeable future, standard SA 570 says at least 12 months. That means minimum 12 months. I can say for the next 10 years also no problem. Next 20 years also no problem. But minimum to minimum next 12 months you have to assess whether you are able to continue or not. And this particular element, only if there is a going concern problem I will mention in the report. If everything is fine, I will not mention in the report. If you are never sick, you are absolutely good, will you go to the doctor? No way. Only if there something is going wrong in your body, only report will come. Clear? So only if going concern is in danger, auditor will mention in the report. If going concern is not in danger, then I will never mention going concern in the report. ITC report you take, you will never see going concern problem there. Vodafone India you take and see going concern problem is there. Clear? Now in such cases, GC problem when it is there, I will have to tell it to the users that boss, see, company has GC problem, watch and go ahead. Clear? Now that is what here, it is on the assumption that company will continue for a foreseeable future. If you have any issues, you have to mention under going concern. If, for that, I should first evaluate management's assumption, and this particular evaluation, everything we will be doing in SA 570. That is why many people do SA 700 as a second chapter. Clear? Now I would always recommend do SA 700 at the end, because SA 700 is the end point of audit. Clear? And when you are doing end point of audit, it is better if you have knowledge of chapter 4, chapter 7. Clear? Only then you will be able to appreciate this much better, and you can cover it up faster rather than covering it as a first or second chapter right away. Okay? Next, key audit matters. So what is key audit matters? Again, we have a separate standard called SA 701. Key audit matter is not a mandatory para. Yes or no? No, it is a mandatory para for listed companies. Clear? For other companies, for unlisted company, private company, you can decide whether you want to include or not. But for listed company, you have to include key audit matter para. If there is nothing to discuss also, you should tell there is nothing to discuss. But key audit matter is very important for listed company. Now, what is key audit matter? Under SA 260, I will be talking to TCWG 1000 matters. Out of that matters, which is extremely important only, I should put it here. Who decides what is important, what is not important? It is me only who will decide. It could be 2 matters, it could be 3 matters, it could be 10 matters. You take a call. For example, in regular classes, I have shown you SA 701 ITC report clearly I had shown you where they are told revenue recognition is a risky matter for ITC. Clear? So like that, if auditor feels something is very important for me to discuss, you can discuss under key audit matter. Then comes management responsibility. What is their responsibility? Preparing FS, internal control, going concern. Clear? Now these are the three responsibilities they have. Point number D and E is technically not put it in SA 700 original report. Here why they have mentioned is just to give you a reference that SA 200 tells you what is responsibility of management, and SA 210, those management's responsibility will be agreed on written engagement letter. Clear? Then comes our responsibility. What is our responsibility? Entire syllabus of audit is summarized here. Clear? What is my responsibility? My objective, rare, reasonable assurance and reporting, telling that reasonable assurance is a high level of assurance, that misstatement can arise from fraud or error. Then next I should tell I have exercised professional judgment and professional skepticism. Then I have identified and assessed ROMM. I have put my procedures. I have obtained my evidence. Risk of fraud is more than risk of error. Risk of management fraud is more than risk of employee fraud. All these things I'll be mentioning under this particular responsibility paragraph. There are three divisions of responsibility paragraph, but in original report it is nothing but one lengthy para. Okay. Then in now point number C here, one more thing I want to tell you. When SA 600 applies. Now what is SA 600? Branch audit we have discussed. Or rather than branch audit, in original report we talk about component auditor, subsidiary auditor, joint venture auditor, associate auditor. So when SA 600 applies, that means not everywhere SA 600 will be applicable. When SA 600 applies, you have to mention about what is your responsibility and what is their responsibility. In regular classes, we have taken SFS report as well as CFS report. In SFS report, you will never see this. Because in SFS only I am auditing. In CFS, there are many subsidiaries and holding. Holding I will be auditing. Some subsidiaries, some other person will audit. Clearly there is a division of responsibility where they will tell so many subsidiaries we have not audited, so many subsidiaries they have audited. Clear? But for your benefit, let me just give you an idea on that. Now, if you see, this is consolidated financial statements. Independent auditors report is 318. If we go to page number 318. Yes, here. Now, if you see here, they have told what? We did not audit the financial statements and other financial information in respect of 32 subsidiaries whose financial statements include total assets so much. Now, ITC CA have told how many subsidiaries they have not audited? 32. That means this is done by whom? These financial statements and other financial information have been audited by other auditors, which financial statements have been furnished to us by the management. So we have not done the audit of 32 subsidiaries. Those report has been done by someone else and management has taken that report and given it to us. We have not done the audit. Clear-cut responsibility I am telling. That means when you are holding responsible, no, don't hold me responsible for those 32 subsidiaries. For those 32 subsidiaries, you hold them only responsible. I have just used their report. SA 600 is applicable here. Clear? That's why you see when SA 600 applies and not at every point of time. Clear? Like this entire division I'll be telling what they have done, what I have not done, and in case of any amount is unaudited, I'll be mentioning under this particular para. Now, you should also further state that what is your scope, timing, and audit findings that I have spoken to TCWG. And with the TCWG, I have spoken with respect to my independence. I have communicated with them all relationships that will affect my independence and what all safeguards I have applied. Now, this is very important. In chapter 11, we have seen if there is a threat, you are supposed to put safeguards. If safeguards is not successful, then you have to withdraw from the engagement. Same logic here. You should tell to TCWG because it's a mandatory thing under SA 701. You have to communicate CAM. Even under SA 260, communication to TCWG, it is mandatory for you to tell TCWG that, see, these are the relationships I have threats with and these are the safeguards that I have put. So I have done my responsibility properly. You have to go and tell TCWG that. Then, You should also, in case of the listed company's financial statement, you have to communicate key audit matters. Now, what are key audit matters? Those important matters in the audit of FS. Therefore, I decide what is important and what is not important. So, again, is KAM a mandatory paragraph? No, it is a optional paragraph. It is for me, but for listed entity it is mandatory. Number one. Number two, similarly like that we have EOM and OM para. That is never mandatory. If I want, I can put it. If I don't want, I need not put it. Okay. But opinion para is mandatory or not? Yes. Opinion paragraph is mandatory. Basis for opinion, mandatory. Location, where I have to tell my responsibility, you can tell in the report only, or you can give a separate report as an attachment, or you can put in your website and give a link of that in your report. Either way, you have to communicate. Third, other reporting responsibilities, sir. See, management reports one, management responsibility one, then auditor's responsibility two. Now, other reporting responsibility. Under this heading only, CARO will come into the picture. Plus, section 143 subsection 3 comes into the picture. All those will come under point number 10, other reporting responsibilities. 11th one, signature. Who should sign, sir? Obviously, the CA should sign. In whose name? His personal name. Sir, what do you mean by personal name here? Personal name doesn't mean what you call at home. Personal name means what? His full name. Clear? Then, if the firm is appointed, you have to sign on behalf of the firm. Therefore, two names should be there. Firm name as well as the CA who is signing his name. Clear? Then you have to tell whether you are a partner or proprietor. And you should also mention your registration number as well as firm registration number. Individual membership number as well as firm registration number. Place of signature means where? Location, city where you have signed the report. Then date. Which date I should put? The date where you decide, but not earlier than the date on which you have obtained SAI. That means you should not date the report first and then get SAI. Get SAI, conclude and then finish your report. Once your report is signed, after that you cannot do any procedures or you cannot obtain any evidence there. Clear? That, and also you have to mention something called as UDIN, unique documentation identification number, or unique document identification number. MCQ, it is important for what, sir? All certificates. Clear? Whenever you are giving certification, attestation, all those things, reports, you will have to generate UDIN. Okay. Then SA 705 talks about modified opinion. When will I give modification? I have already told you, when you have evidence that mistakes are there. Second one is when you don't have any evidence. In both scenarios, you should give modified opinion. So when you conclude based on the evidence that financial statements are not free from therefore evidence also is there. Material misstatement also is there. Clear? Second one is unable to obtain SAI. That means evidence only is not there. I cannot say whether misstatement is there or misstatement is not there. In such case, I have to take an assumption or I have to evaluate whether in future there will be misstatement or not. Clear? Therefore, in the standard, whenever they say misstatement, it talks about evidence. If they say potential misstatement, it means unable to obtain SAI. Potential means what? There could be misstatements. And if I'm saying there could be, that means right now I don't have any evidence. Positive also, negative also, I can't say. Because do you have evidence to say positive? No.
Not evidence to say negative.
That's the reason why we give disclaimer there. Disclaimer means we have no opinion. Neither positive nor negative. We also give qualified depending upon our judgment about pervasiveness. If we think that, see, I don't have any evidence. Imagine now about you, he comes and complains that you are bad. Now I don't know about you. If he comes and gives me that information that, sir, Naveen is a very bad guy, sir, I don't know whether he's bad guy or good guy because I don't have any evidence. But if I assume that you might have done something wrong, but it is not a big thing, it's a very small thing, then I will tell qualified. But if I assume that, okay, you have done such a big thing which will affect many people in their life, then I'll tell I have no opinion about this way. Now imagine, generally imagine you want me to give an opinion on one person. Now if I say best person, you will have confidence to go to do business with him. Correct or not? Now imagine, for example, I'll talk about JN and you come and ask me, sir, how is JN? Now I have evidence about him and I'll tell best person here to do business. Now you'll have confidence, so you'll do business with him. Second scenario, you will come and ask about him. Now I know that fellow is a little angry young man. Now I will tell you, see, JN is good, only anger issue is there. Now you will tell, anger issue, no sir, that no problem, I can handle it. You still have confidence. Now in the first scenario, I told he is best. Second scenario, I told he is good. Third, you are telling, now I know this fellow has done fraud. And tell, oh, that fellow, 100% you will do fraud with you. Which means I have evidence that he has done fraud. Now you will not do business with him. Last scenario, will come and ask me how he is. I don't have any evidence. I'll tell, boss, Jayana, I have no comments. Now tell me, in where your confidence is absolutely low. At the last when I told, I have no comments. At least when I tell bad, you know that I'm telling bad. In the last scenario, no, you are only confused now whether it is good or bad. You will never go to that particular person at all. At least bad, you will go and approach him saying, see boss, I know you have done so and so things, don't do it. But if I say no comments, I also don't know how he is, you also don't know how he is, you will choose another company for investment. That is disclaimer of opinion. So pervasiveness is the key in essay 705. What is pervasiveness? Pervasiveness is the effect, how and where all it will affect. Clear? Or rather, where all it will affect. For example, in the general class only same example I give. So those who do not know, for you it will be better. If I put one drop of oil in the water, it is non-pervasive in nature because the oil floats. It doesn't affect the entire bucket of water. But if I apply one drop of ujala or comfort in the water, the entire water is contaminated now. I can't use it for anything else. Therefore, oil is pervasive or non-pervasive? Non-pervasive. Whereas the other substance is pervasive. Why? Because it affects many places. So if it is affecting many places, then I cannot do anything. Clear? Number one. Number two, now there is a new example for your pervasiveness. So concentrate. Sir, in the water, drinking water, one drop of oil fell, no problem. You will take that oil drop and throw it out and drink the water, no issues. But what if the cockroach fell in that? Cockroach also is not affecting multiple places. You can throw that cockroach and still drink. No, you won't. Because now it is such a huge thing that the entire water is contaminated because it's okay, it is not spreading into the water. Although it is only one substance, it is contaminating the entire water. That also is pervasiveness. That is the example of point number 2. First point says what? The effect of the financial statements that the misstatements are not limited to specific elements. It is spreading all across the financial statements. For example, closing stock valuation went wrong. Where all it will affect? Gross profit, yes, trading account, net profit, reserves and surplus, current assets, yes, total assets, ratios, look at the effect. Clear? On the other hand, if you are talking about 2, if it is limited also, it represents or could represent substantial proportion of financial statement. Let us say I am an investment company, okay, and my investment is 90%. Now my 90% of investment is misstated. Investment is not going to affect multiple places. Clear? Interest calculation is correct. So P&L is correct. But my balance sheet, 90% of the investment is wrong. It is still pervasive because majority of the financial statements are wrong now because the proportion is so huge. It is covering the bigger part of financial statements. So number 1 says it is not limited to one area. It keeps on affecting multiple areas. Whereas number 2, it is limited only. It doesn't affect multiple areas. 1, 2, 3 areas only. But the 2, 3 areas only is covering bigger portion of the financial statements. So this is also important for us. Let's take general example. During election, why in only some areas of protection is more? Why in other areas protection is less? Police protection will be there during election. Why is that? Because in those areas, the risk of riots are high. Clear? In other areas, the risk of riots are not that much. That's why we prioritize that. It may not affect multiple areas, but that one area is covering the entire district. So So such things are very important for us. It could be one misstatement or multiple misstatement. We'll have to judge with respect to pervasiveness. Is it affecting or not? If it is affecting multiple areas, pervasive. It is not affecting multiple areas, but whatever is misstated considers a bigger chunk of financial statements still pervasive for us. Third pervasive is not with respect to amount misstatement, it is with respect to disclosures misstatement. Example, going concern disclaimer or going concern disclosure. If you are not telling the user that you have a problem, it's a very big problem. Clear? Nothing. Every amount and all is correct. But they know that government is coming up with a notification to ban your business. You know about it, but you're not disclosing it to the users. So users will think what? Let me put more money into the company, nothing will happen. And that is a wrong disclosure you are giving. You have to give disclosure. That is exactly why in SA 570, in modification, when we talk about modification in SA 570, we will have to talk about disclaimer. Let me just show you that. In SA 570 going concern, if you see reporting requirements, here going concern is appropriate, but there is uncertainty existing. If adequate disclosure is not made, we end up giving qualified or adverse opinion. Clear? Right, sir. Next. So if your financial statements are materially misstated, and if you consider that misstatement is pervasive or not pervasive, accordingly, my opinion will change. I'll give you one shortcut to remember. In SA 705, if the misstatement is material, only then you will come to SA 705. If the misstatement is not material, no, you will not even bother giving modified opinion. Clear? Modified or alteration of opinion will come only if financial statements are not free from material misstatement. So if misstatement is not material, no, you will be least bothered about giving modified opinion. In SA 705, if you have come, that means misstatement is 100% material. The only other thing left is pervasiveness. Clear? So therefore here financial statements are materially misstated. If you judge it is material but not pervasive, you give qualified. If you judge material and pervasive, you give adverse. So you have to read it this way. From here you start, go here and then come here. Clear? Similarly, from here you start, go here and then come here. So financial statements are materially misstated, material but not pervasive, give qualified, material and pervasive, give adverse. Inability to obtain SAI, that means I do not know whether misstatement are material or not. If it is immaterial, forget about SA 705. But if you judge that there could be potential misstatement which is material, I don't know, it could be there. In that case, then SA 705 will tell you what opinion to give. What opinion you will give? Again, start from here, go here and then come here. If it is material but not pervasive, you give qualified. If it is material and pervasive, you give disclaimer of opinion. Clear? So moral of the story, only 3 modifications. Number 1 is qualified. Number 2 is adverse. Number 3 is disclaimer. When do you give qualified? Whenever, whether I receive evidence or I don't receive evidence. If I say that it is not pervasive, then give qualified. If it is pervasive, evidence is there, adverse. Pervasive, evidence is there, evidence is not there, disclaimer. I repeat. Material misstatement, pervasive, evidence is there, adverse. Misstatement is material, pervasive, evidence is not there, disclaimer. Understood? Clear? So you will be worried more about this. Qualified is easy. Qualified has only one thing. Misstatement, whether it is there or not there, it's fine for us. Pervasiveness, if it is not there alone, will be giving qualified opinion. Sir, if management has imposed limitation on my work after I accept the engagement, what to do? Before I accept the engagement, if they put what to do? Chapter 11 only we have seen, don't accept only. But after I accept, if they put any limitation, see, before the marriage, if you get to know your partner is toxic, you can leave it. You need not accept the proposal only. But you accepted the proposal, got married, then the partner became toxic. Now what will happen? Now you either have to divorce or you have to fight. Clear? So in that case, when the partner is becoming toxic, standard says, first request the partner not to become toxic. Okay? Request them to remove the limitation. If they remove the limitation, good, proceed with your audit. If they refuse to remove the limitation, communicate to TCWG, tell partners' parents, clear, and perform alternative procedure, meaning start fighting. Okay, now even after telling parents, parents are also not taking any action. I am still unable to obtain SAI. In that case, I can give qualified opinion. Clear? If qualified opinion, when I will give qualified opinion, misstatement is there, it is material but not pervasive. It's okay, sir, no problem, not pervasive, I can live with it. But if it is material and pervasive, too much toxicity, clear? In that case, divorce. Withdraw from the engagement and tell TCWG that I am done with your son or daughter. Understood? Clear? This is the entire concept of limitation after acceptance. Before acceptance, all these things are not there at all. Directly don't accept. Clear? Now, this is pretty important from the exam point of view. And in 3 different modified opinion, what is the language that I am supposed to use? This here 100% exactly you have to write. That's why I put it in the box separately. Right? Number 1, if you are giving qualified opinion, what you should talk? You should tell, I am expressing the qualified opinion due to misstatement, except for the effects of the matters described in the basis. So, like how I told Naveen with respect to Jayan that he is a good boy but only anger issue. That I have to tell under basis for opinion. Clear? So in basis I will tell everything is good in the company except these matters. So those matters I will mention in basis for opinion. Next, if I am giving adverse opinion, what language I should say? I will tell, no problem sir, everything is good except this, that is qualified. But what exactly, because of these matters I am not giving good opinion. That because matters I should put here. So here if you say because of importance of matters described in basis for opinion para. Now here it is except for and here it is because of. Okay. So in the opinion para you will tell adverse opinion and then you will tell because of so and so. If it is qualified opinion you will tell except for so and so. Clear? For example, let us see here. Now, if you go to Vodafone reports, (141). Right. Now, what opinion they have given? Only opinion, which means unmodified opinion. But if you actually see here, basis for opinion also you should give. Clear? Key audit matters also you should give. All these other information also you should give. So that means here now going concern problem is not there. But I showed you 2021. Right after COVID, when AGR dues Supreme Court case law had, Supreme Court had decided with respect to Vodafone, they had given going concern problem here. Now when you give unmodified opinion, what paragraph you will give? Only opinion para you will give, which means it is unmodified. But if you see, if you go and see, let's say Adani Enterprise, if you see, actually 24. What opinion they have given? Qualified. Now, when you talk about qualified opinion, we have audited so and so. Read the second para. In our opinion and the best of our information, and according to the explanation given to us, except for. So, when you give qualified, you have to mention what? Except for. When you are giving adverse opinion, you have to say because of. Clear? Because of so and so matters, I am giving negative opinion, and you have to tell the financial statements do not present fairly, or you can use they do not present true and fair view. This true and fair view will come in which framework? Fair presentation framework. If it is compliance, you will write it is not prepared as per AFRS. Clear? Next, disclaimer. In case of disclaimer, no, I will tell I do not express an opinion because of the significance of the matters described, I am unable to obtain SAI. I am not able to obtain SAI, sir, and because of that only I am giving disclaimer of opinion. Right? Then you have to amend the statement saying, I have not audited them. You should say, I was engaged to audit. Rather than telling I have audited, you should tell I was engaged to audit, but I have not gotten any evidence. Because the moment you say I have audited, you have to have evidence. Clear? Okay. Now, in basis for opinion, what should I specify? You told no, tell. The question is, what should I tell now? Number one, if it is an amount misstatement or if it is amount related points, then description and quantification. What does description means? Details. Quantification means what? Measure the amount and tell how much. 1000 crores, 2000 crores. Measure the amount and tell. If it is not practicable to quantify, then mention that it is not practicable to quantify. If the misstatement is with respect to disclosures, explain the disclosures. If the misstatement is with respect to non-disclosure, then tell in the para, discuss the non-disclosure first with TCWG. Because what if confidential matters it is? If it is a confidential matters, you can't go and disclose outside. So first to discuss with the TCWG, these disclosures, why didn't you not make? Number one. Number two, describe the nature of omitted information. What type of information it is? Is it financial related, non-financial, clear revenue based? What type of information it is? Unless prohibited by law or regulation, include the disclosures. But if law prohibits you, don't include the disclosure, but just tell the nature. What type of information it is? The company did not disclose the information with respect to share capital. That's it. What it is, I cannot tell because law is prohibiting me to tell. If law does not prohibit, that also I will tell it. Understood? Clear? Now imagine I spoke to management with respect to holiday. They told me something which I can't tell you, and I will tell holiday is not there. Now you will ask why. I'm like, I can't tell that. That is something that is discussed with the management. I can't tell that. Now you have to accept that. You can't say, sir, no. If you don't tell, you will not leave the class only. I can't do anything. Clear? Because there is a rule, there is a law which is prohibiting me from telling certain information. I can't tell such sensitive information. Clear? Reason, public interest will be gone. Clear? If public outrage starts, no, then the entire economy can also shake. That's the reason why certain information which I will not disclose if it is prohibited. Then, if the modification is because you are not able to obtain SAI, tell the reasons why are you not able to obtain SAI. Clear? If you express qualified or adverse opinion, amend the statement where evidence obtained is sufficient and appropriate to provide a basis, because you don't have SAI, number one. Number two, whatever SAI you have got is telling it is wrong. So you have to clearly tell whatever is the fact in this particular para. If possible, whenever you are disclaiming an opinion, very important point here, whenever you are disclaiming an opinion, what you should say, a reference to the section where responsibilities are described is there, no, that you should remove. Because your responsibility is no more there. You tried everything, you didn't get any evidence, so remove your responsibility para, then only include certain things. Now, a statement whether evidence obtained is sufficient and appropriate also should be removed. Why? When will you give disclaimer of opinion? When you don't have any SAI. Therefore, in the report, please remove the statement saying you have obtained SAI. Otherwise, you will give disclaimer of opinion, and in the report responsibility you are telling I have obtained SAI. How is it possible? It is contradicting the standard. Therefore, if you have not obtained SAI, tell in the report you have not obtained SAI. Okay? Important. Whenever you are disclaiming an opinion, how your responsibility para should look like. Include only three things. That is, your responsibility is to conduct an audit. That's not that you have done the audit. Clear? It is my responsibility to conduct an audit as per the standard and to issue the report. Number one. Number two, tell because of the matters described in the disclaimer of opinion section, I am not able to obtain SAI. And tell that you are independent and you are ethically responsible person. I have followed my ethical requirements and I am an independent person. That means the opinion that I am giving is not biased opinion. If it is a key audit matter, put a separate section as KM. And if you are disclaiming an opinion, do not include key audit matter. Clear? If you're expecting to modify the opinion, go and communicate with the TCWG what type of opinion you're giving, expected modification and wording of the modification. Like I'm going and telling, boss, I'm modifying the opinion, I'm giving adverse opinion. That time TCWG may tell, sir, don't give adverse opinion, we will take care of it. What now? I have to rectify the situation? No, I will do it. So, without communicating to TCWG, you cannot give any adverse, disclaimer or even qualified opinion. Unmodified, no problem. But when you're modifying, no, you have to go and communicate to the TCWG. That's SA 705. Next is SA 706 talks about what? EOM para and OM para in the independent auditors report. Now, EOM para talks about emphasis of matter. Only one difference and we are done with this. Okay. What is the difference between EOM and OM? What is the difference? Any idea what is the difference? Emphasis means what? Sorry? Focus with stress is correct. But in the exam, what will you write? Paying attention. Now, try to understand the logic of this particular para. Emphasis means correct. I never asked what is emphasis. I asked when will you put this emphasis? What is the difference between EOM and OM para? Both focuses on stress only. Both focuses on attention only. But the point is, EOM is a VIP seat. Okay, OM is a general seat. So if something has to sit in EOM para, no, it should have a criteria. Tagdi. Criteria should be there. And what is that criteria? Any matter to sit in EOM, you should be a financial statement matter. You should already be there in financial statements. Only then you can sit in the EOM para. If you are coming from a place which is not financial statements, then you sit in other matter para. That is the conceptual difference. Clear? Which matter should be included in EOM? Only those matter which is already presented or disclosed in the financial statements. If it is not presented or disclosed in the financial statements, it should be sitting in other matter paragraph. Example. Sir, I want to put in EOM a matter with respect to bad debts. Can I put it? The answer is yes, because bad debts are already disclosed in the financial statements. But, sir, there are 60 subsidiaries which I did not audit. I want users to know this. Where will I put? EOM or OM? OM. Because I never audited those. If I did not audit those, I will never talk to KM only, no. Because key audit matter it is. I never audited subsidiaries. So therefore it will not come under KM, it will come under OM. Because number one, I didn't audit. Number two, that information is not there in the current year financial statements. Therefore, KM is out of the question. Number two, EOM also is out of the question. The only para left is OM. OM is like dustbin. Anything else that doesn't fall under KM and EOM has to fall in OM. Clear? The only criteria you have to see, if I have to put in EOM, it has to be a matter from financial statements. It should be either in P&L, balance sheet, CFS, SOC or disclosure. Anything outside this, you will have to sit in other matter paragraph. So EOM is like the VIP guy. Okay? Alright. That's the entire concept of EOM and OM. EOM is what? EOM is a paragraph that refers to a matter appropriately presented or disclosed in the financial statements that in your judgment it is important for users' understanding. You want users to focus on that matter. Now I will ask you, you came up with a matter to me and you're telling, sir, I want to disclose this here. Where should I disclose? Now imagine you're an article and I am the CA. Now you come to me and say, sir, the thing is, I have one matter, sir, I want to discuss with, I want users to focus on this particular matter. I'm like, good thing. Where should I put this matter, sir? First question I will ask is, what matter is that? And I will ask, from where is this matter? If you are telling, it is already disclosed, sir, but so many disclosures are there, they might be feeling lost. So I want users to specifically focus on this. Now I will ask you, is it already disclosed in the FS? If the answer is yes, EOM. If the answer is no, OM, straight away. Clear? But disclosure you can give. Sir, are these compulsory para? No. These are not compulsory para. These are, you are telling user, you want users to focus. If you want users to focus, then you can put it. If you don't want users to focus on this, you need not put it. You know why? You know why? One more logic. Financial statements is prepared by whom? Management. So, how they focus there, I do not know. How they focus there, I do not know. I was appointed by whom? I was appointed by whom? Users, shareholders, members. Financial statements are prepared by them. Clear. Report is given by me. Who appointed me? User. I want users to focus on an important matter in the financial statements. So I will stress on that in my report. And where will I stress that? In EOM para. Anything apart from FS, I will put it in other matter para. Got it? Okay. Conditions before including in EOM para. Number one, it should not be a modification. Why it should not be a modification? Because if it is a modification, no, you can't put it in EOM. You have to put it in modified para or basis for opinion para. Yes.
Sir, what if it is not material in financial statements?
What is not?
What if it is not material in financial statements?
Here they never mentioned that whether that important is material or immaterial. Here the logic is fundamental to users' understanding. Even if it is an immaterial information, if you feel they have to understand this with respect to their financial statements understanding. If they don't know this, they will not understand financial statements understanding. Then even if it is immaterial, I can mention it in EOM, absolutely no issues. How will I mention in EOM is, now imagine there are 30 notes to accounts given by management. Now there are some contingency disclosure they have given. I want my users to focus on contingencies. Now technically contingency, when they don't focus, nothing will happen. But I will mention in EOM para saying, we draw your attention to note number 30 subnote A. And I will only mention some summary. Done. Now what will users see? They will see EOM. Oh, note number 30. CA has asked me to focus. I will go to note number 30 and I will read. If I don't mention this, they will never go to note number 30. Now management says, we have disclosed, they have not read it. How is it my problem? So when I tell them, see, go to this note number, they have clearly mentioned this particular information. I will not tell the entire information. I will just tell them, go here, this is the information. Now you will be going there, reading that, understanding, and then reading the financial statements again. So it doesn't matter whether it is immaterial or material. The point here is it required for fundamental understanding? If the answer is yes, you can put it. If the answer is no, you don't put it. Okay. Next, the matter should not be a CAM because CAM has a separate para. Clear? Modification also has a separate para. Therefore, put it in separate para. Don't put it in EOM para. Okay. Then, like how, you have this, I don't know, in our house, we have this, rule that whenever you're putting clothes for washing, no, white separate and color separate. Clear? I don't know all those things. For me, washing is washing. All the clothes I take and put in the washing machine. Clear? My mom yelled at me once because every other all the towels, no, it started getting good colors of my other outfit. Now she said, who asked you to put in the washing machine? I'm like, washing machine is there, I'm putting it. She's like, no, there is a rule for that. I'm like, in house also there is a rule? He's like, yeah, white separate and other separate. I'm like, I don't know this. So from that day onwards, I stopped putting clothes in the machine. I just put it near the machine. My mom will segregate and keep. Now that is the EOM. She says that white first, then colored outfit next. So that I'm telling, both are being washed. Both are being washed, but the priority is different. Both matters you should put it in report if you want to, but the paragraph is different. EOM comes first, actually, OM comes later. Why? Because those which is already there in FS, I'll have to put it in EOM. Those which is not there in FS, I can put it in OM. Understood? Got it? Yes, sir. Separate section for EOM. You can't put it under any other section. You have to give a separate heading called emphasis of matter paragraph. Clear reference to the matter you should give. Sir, should I describe the entire matter? Don't describe the entire matter, but just give a reference to the particular note. Clear? For example, now let's see if there is EOM here, emphasis of matter here. There is no emphasis of matter. Let's go to Vodafone. It's there in my iPad to give. Let's check. 131. Here, annexure 1. Okay, see here. This is the going concern disclosure, material uncertainty with respect to going concern. See how they have drafted the para. We draw attention to note number 4. Now, technically, they have not told you full matter. They have just given you the summary of that particular note. So, what you should do now, if you are the user, what they have told, we draw your attention to note number 4 to the financial statements, which describes the company's financial condition. Correct? Huh? Now, if you want to know more about this, go to note number 4. There, management has given full disclosure. Clear? But if this was not there, you tell me, would you go to note number 4 first of all? No. Possibility is there that you will not see. But I want you to see specifically that, therefore, clear reference they have given. Imagine, what does this unclear reference means? Imagine they have told, we draw your attention to note. Which note? Where is it? If you have not told me that, what is the point of putting emphasis? I can't stress on something. Imagine I tell you, hey, this is there in one of the pages in the book. Now, if I tell you this is there in one of the pages in the book, around 400 pages, which page where? But if I clearly tell you, go to this page number, go to this point and go to this page, this point is there. Clear reference I am giving you. Clear? That is why in the class you always study with cross-referencing. Clear? So that proper emphasis is given. Then indicate that your opinion is not modified, because if it is modified opinion, no. If it is a matter of modification, you have to put it in basis for opinion and not in EOM para. Clear? Examples where we have to include EOM para. Going concerns are uncertainty with respect to future litigation or regulatory action, contingent liabilities. Contingencies. If it is a contingency matter, then I can put in EOM, no problem. Subsequent event occurring after balance sheet date, AS4 topic, you can put it under EOM para, no problem. Early application of new accounting standards. Sir, you need not, when Ind AS came, no, it was not mandatory for every company from a particular date. Different companies had a different date of execution. But imagine I voluntarily adopted Ind AS from today onwards. Not mandatory, but I voluntarily adopted. I have to tell users that boss company has adopted Ind AS. Please note it down. Clear? Because without that, you will not be thinking why these people are telling there is, let's say for example, Ind AS believes in fair value, whereas normal AS believes in historical cost method. Clear? Everywhere we are using fair value. Users will never understand why. Therefore, in EOM, I tell company has adopted Ind AS rather than AS. Then, EOM is not a substitute. Hidden question, very important question. What is it, sir? EOM cannot be a substitute, meaning instead of something, you can't put EOM. Meaning that something is mandatory for you. EOM is optional. Remember one thing, guys, EOM or OM is not a mandatory para. It is my para. I can decide whether to put it or not. But these three things are mandatory. Clear? Can I put mandatory matter in an optional para? No. Clear? Mandatory matter should be put in mandatory para only. Number one, modified opinion. If it is a modified opinion, you separately have a para called modified opinion and basis for modification put there. Number two, disclosure that management is supposed to make. I will tell management, hey, loser, your disclosure I can't make. Your disclosure you only have to make, because for you it is mandatory to put disclosure in the FS. For me it is not mandatory. So if I put, it doesn't mean you are exempted. You have to put. Clear? Then SA 570 going concern. Going concern, why not in KM or EOM, sir? Because going concern as a separate para I just showed you. You have to give it separately. Then what is other matter para? Refers to a matter other than those presented or disclosed in the financial statements. Other than, outside the financial statements, any matter is there. Example, unaudited subsidiaries. Unaudited subsidiaries. Provided you can put those extra information, but it should not be prohibited by law. Imagine company is discussing with respect to amalgamation next year. This year, no transaction of amalgamation is done. Okay, think and answer. Next year, they are thinking about amalgamation. I got to know from the company. This year, no transaction of amalgamation. And in the report, I am telling in other matter paragraph, company is going for amalgamation next year. Mad fellow, this is sensitive information. If you tell this, tomorrow everyone will start buying shares of my company. This is a very serious and sensitive information. Next year they are planning for buyback. Now only I'll tell that my users, remember, understand, company is going for buyback next year. Now this particular report everyone can read. Users, non-users, everyone can read. And SEBI considers these type of information as PSI, price sensitive information. And price sensitive information you cannot tell outside. Clear? It will be like one insider trading only. Clear? So in such cases, no, they have told there is a law or respective law can prohibit you from disclosing certain information. If there is a prohibition, you cannot put it in other matter para. Even though it is important, you feel it is important. I cannot, because law is bigger than the disclosure. Clear? Number one. Number two, if it is a KAM, don't put it in OM. Why? Because it has other para. Give a separate section called OM para. We have already seen example. CFS of ITC. We have already seen that. Sir, whether you give EOM or whether you give OM, you have to communicate to whom? TCWG with respect to the expectation and wording. Got it? Okay. Next, 701. Communicating key audit matters in the report. Clear? Now, in this, specific questions are there. Question number 1, why are we communicating? Clear? Question number 2, what tells you it is a key audit matter? Question number 3, communicating key audit matters is not a substitute. 3 questions are there, easy questions. Okay? Why we are communicating KAM, sir? Before that, is KAM a mandatory para? For listed companies, yes. For others, it is not. Clear? Okay. So, if it is there, why are we supposed to communicate this, sir? For 3 reasons. Number 1, enhance the communicative value of the report. Sir, enhance the communicative value means our report does not have communicative value. It is there, but we are enhancing it. We'll improve our report communication by giving greater transparency about what? Audit that was performed. See, you know what this para is? This para is to tell users that how good I am. This para is to tell users how good I am, how good my audit was, how good my procedure is. Clear? So basically this is my para, show off para. Clear? In all other para I am talking about financial statements. Only in this para I will talk about audit. How I have identified this matter and how I have resolved this matter. Now when I say this, users will get to know how good I am. Clear? Yes.
What exactly is communicative value?
Communicative value. See, why the report stands for what? Why are you reporting? You can just tell opinion and switch off, no. But why are you reporting more?
To improve their confidence.
Exactly. To improve their confidence, I need to give more information to them. So when I give more information to them, I am communicating to them. Generally, imagine written report was not there. I need to communicate to you. How do I communicate to you? Orally, I should communicate to you. When I communicate to you, I will be communicating that management has done like this, management has done like this, management has done like this. About me, have I told you? No. About me, if I have to tell you, I should tell you how I have identified the audit, how I have identified certain matters in the audit, and these are difficult areas, and how I have maneuvered these difficult areas. Now, in the class, I will be telling how the subject is, how the subject is, how the subject is. But in between, I have to tell you how I have gone through this course, how I have seen this subject, and how I have handled this. When I tell that, don't you feel that, okay, even sir has also handled like this only. Confidence will increase. Yours and my communication will be better. So, the report has a communicative value, it just enhances. So, user will understand not just management side, they will also understand my side, how these matters were important and what all procedures I have put to solve these particular matters. That time you will have a better rapport with the auditors. And because of this, what will happen? Nothing is told here, but it's my presumption. Because of this, next year when you're appointing me, you will know that I was good. Because in a company, only 5 years is what you're appointed for. After that, 5 years schooling period. After that,
You're more likely to get recognized.
exactly. So they will tell that, sir, that old CA was there. No, he was actually very good. How do you know I was very good? Were you there in my audit? No. How do I tell you without telling you? That is true. Key audit matter. Got it? So it will enhance the communicative value of what? Of the report. How? By providing greater transparency about the audit that was performed. Number one. Number two, I am giving you additional information. Why? To help them in understanding those matters in my judgment were of most significance. Meaning I can actually shut my mouth and finish my audit. But I am giving you additional information. Why? If I don't give this additional information, you will never understand those matters which I feel is important. Clear? Number C. It may also help the intended users in understanding the entity and areas of management judgment. Because there are many places where management has taken judgment. Who judges management judgment? Auditor. Don't you think I should tell this to users? See, these are the judgment they have taken into consideration and how I have considered that is reasonable or not. Therefore, you will understand it better. Again, this technique, all these things are whatever is there, you and I will not read this. Then which user we are talking about, sir? Those users who are actually bothered about the company's growth, company's problems. Clear? Big shareholders, promoters. Clear? Huge, like 20%, 30% if you are holding. Then for those shareholders, they want to know what is happening in the company because their investment is there. Clear? Now, imagine you have given fees to ArivuPro X amount. You will be bothered only about your class. Yes or no? Because you have given fees only for your course. Imagine you are the owner of ArivuPro. Will you be bothered only about CA Inter? Or will you be bothered only about Coimbatore branch? No. You want to know about Coimbatore also, Chennai also, Bangalore also, upcoming branches also, everything. Everything you have to be bothered about. Therefore, you will read more rather than a student reading audit report. Are you getting my point? You will be more focused only on my course. Whereas if you are an investor, you will be more focused on everything that is happening in the company. Right? These are the 3 points you have to write. What is the purpose? Enhancing the communicative value, providing additional information, assisting the users. Then, determining key audit matter. Now, what is key audit matter? We will be, from where are we taking key audit matter? Source number 1, from the matters communicated with TCWG SA 260. Second, those matters that require significant auditor's attention in performing the audit. This may be there with TCWG, may not be there with TCWG. In making the above determination, so basically 2 sources. Which are the 2 sources? SA 260 and whatever I feel is important. Clear? Now, how do I define my importance? There are 3 ways to define. Any area where risk is high. Any area, example, RPT or transaction outside normal course of business. Then, significant auditor judgment with respect to management judgment having high estimation, uncertainty. Example, SA 540. Clear? Understood? Now, the effect on the audit of significant events or transaction that occurred during the period. That means, example, I will show you this. ITC Hotels demerger. Now, I am talking about key audit matter, and third one I am talking effect on the audit of significant event or what? Transactions. Let's go and check it out. Now, if you go here, this is the independent audit report. Can you see key audit matter? Yes, under this, right, we have determined the matters described below to be the key audit matters to be communicated in our report. Now, first one is revenue recognition. What is the second one? accounting for demerger of hotel business. Now, if you read this point, the effect on audit of significant events, clear, read, or transaction that occurred during the, what they have told here, accounting for demerger of hotels business, and that is what they have given, how it happened and what did we do. Clear? How did we go through this particular transaction? We obtained the scheme, clear, evaluated the design, tested the management's working, appropriateness of this demerger treatment, all these things I'll have to mention. Therefore, then I will tell where you have to go and refer to more information. That way a user will understand accounting part also, audit part also. Therefore, he will get confidence on both. Clear? Now, communicating KM, you have to have a separate para called key audit matter, and you'll have to tell, you have to start your para with this, saying key audit matters are those matters that in professional judgment were of most significance in the audit of FS, and these were addressed in the context of audit. This is important. I do not provide separate opinion on these matters. These are just disclosures. Clear? It's like saying, just saying. Just saying. I am not telling anything else. I am just saying. That just saying is what we call as key audit matters. Clear? Next. Key audit matter. Is it a substitute, sir? It is not a substitute for these four things. Same logic. Repeat again. Number one. For disclosure, the management is supposed to make. See, why? Because for management's disclosure, it is mandatory for you to make. For me, it is optional. Therefore, it can't be a substitute. Number one. Number two. For expressing a modified opinion, why? You have a separate para for modified opinion. Number three, SA 570, going concern. With respect to going concern also, I cannot mention KM. Why? Separate para. If you have a separate opinion on individual matters, again you will be telling it in the separate para. Therefore, don't put it under KAN. Clear? You know why these things are talking like this? Reason being is, if I don't tell like this, no, as an auditor, you will put all these important matters in KM and go through it. Because they know KM people will not read. If I put in basis for qualified opinion, the more attention is caught there. So I'll not put there, I'll put in KM and I will report also, and users will not understand also. So it's a win-win situation. That's why I'm not allowing you to do all these things. Clear? This can be asked for 4 marks. Be careful, not a substitute. Clear? Yes. Okay. Next. Communicating with TCWG, whether you put KM or not, both has to be communicated with TCWG. Tell that you are discussing KM, and if there is no KM also, you should tell there is no KAM in the report. But for listed entities, KM must be there. That is your SA 701. Let's talk about the next standard. Talks about SA 710. 710 talks about comparative information. Comparative information are of two types. One is called corresponding figures and one is called comparative financial statements. Corresponding figures means what? Previous year amount given with respect to current year. Yeah. Now, why am I giving you previous year amount? Why am I giving you previous year amount in the current year FS? Just for comparison purposes, and you will get to know whether there is an increase or decrease. Clear? Now, there could be two cases. Last year's amount could be audited. Last year's amount could be unaudited. In both cases, I should put last year's amount. But if the last year amount is unaudited, in the report, in other matter paragraph, I should clearly say last year amount was unaudited. Understood? Clear? I repeat. Last year's amount you have to put it whether it is audited or unaudited. If it is audited, no problem for me. If it is unaudited, I should put it in other matter para that last year's amount is unaudited. Sir, why sir? You need not put only, no. Last year's amount I should put because it is a framework requirement. Clear? The framework asks me to include last year's amount. For example, in tax audit report, if you see the financial statements prepared for that, when we are disclosing financial statements to tax audit report, their last year amount should be put. That is because of the framework. So whether it is audited or not, I have to put it. Sir, how can, isn't it wrong that you are putting unaudited your amount in the financial statement, sir. It is not wrong, sir, because the law is asking me to put it. Clear? Sir, but for a user citizen, isn't it confusing? That's why I'm telling you it is unaudited. I'm clearly telling the user it is not audited. You take a call after that. What is the nature of comparative information? Two approaches are there. One is called corresponding figures approach. One is called comparative financial statements approach. In India, generally we follow the first approach, corresponding figures approach. Generally, that's why everywhere you see last year's amount. And you will only see one opinion on current year. Clear? But if it's comparative financial statements, no, your opinion should be for every year you have given in the FS. In India, we follow the first approach generally. Clear? There are very remote chances where we'll be talking about two opinions in a specific report, but generally we follow the first approach only. Okay? Now, with respect to comparative information, what procedures we will have to put? Number one, determine whether financial statements include comparative information as per AFRF. Clear? Whether law asks me to do it or not, first determine that. Then, second, if law says yes, if law says no, good for me, I need not put. But if law says yes, then I should first see whether the comparative information agrees with the amount or disclosures presented in the prior period. Meaning, in this year when I am including that amount should be matching with the last year's audited amount. Okay, number one. Number two, whatever accounting policies reflected should be consistent in the current period as well. Okay. If you become aware of possible misstatement in the information, perform additional procedures to see whether such a misstatement exists. Imagine last year there was a misstatement. First of all, whether a misstatement is material or not, it is whose decision? So what is important for you may not be important for me, and what is important for me may not be important for you. And what is not important for me may be important for you. So whether a misstatement is material or not, it is totally a subjective matter. Therefore, imagine last year one misstatement was there. This year you found it as a material misstatement, and in that case, what am I supposed to do? Check whether that material misstatement is still existing or not. If yes, then last year also it was a material misstatement. This year also it is a material misstatement. This year also it will affect my audit opinion. Therefore, I should check whether the material misstatement is continuing in the current year or not, or is it already rectified or not. Number two, if you only has audited the last year's FS, then you have to follow SA 560. What is SA 560? Subsequent events. If you know SA 560, clear? That is why I keep telling students, don't do reporting chapter before chapter number 7. You have to do it after chapter number 7. This will be easy for you. Clear? Now, in SA 560, there is one logic. If you see, there are two dates. One is called financial statement date, which is not relevant for us. We have audit report date, and one is AGM date or financial statement issue date. If after audit report, if you get to know that there is some problem in the financial statement and disclosure has to be given, then I need to talk to management. If management changes the FS, I'll have to change my report and I'll have to give a new report, or I'll have to modify my report. Now that will be applicable here. Provided last year also I only did the audit. But if last year someone else did the audit, I am not responsible for that. Last year I did the audit, this year also I am doing the audit. Then SA 560 will come into the picture. Okay. As per SA 580, you have to request written representation for all periods. Obtain specific WR also with respect to any period. Both are talking about SA 580, again a chapter 7 concept, which is completion and review. With respect to corresponding figures, what are the reporting, sir? Comparative information where amount and other disclosures are included as integral part. Integral part means what? Inbuilt as a part of current period FS only. It is not treated to be separate FS. You will never see two FS given. One FS only, but two different amounts given. For example, if you see here, you take the financial statement here. When you are talking about the financial statement, see, 31st March 24, 31st March 25. So basically, they are giving you current year FS only, but previous year amount they'll give for reference purposes. Clear? Okay. Now, they are intended to be only reading purposes. Read only. Read only means what? Just for comparison purposes and not for anything else. The level of detailing is dictated by it's relevant to its current year amount. Meaning, if it is relevant in the current year, I will give you more information. If it is not relevant in the current year, I will give you less information. They are talking about detail. How much detailing I should give? Imagine last year I had taken a loan. 200 crore loan I had taken last year, and because of that, last year only I took the loan. I need to disclose everything, interest rate, terms and condition, etc. Now, this year I repaid the loan substantially. Do I need to disclose everything again? No, I just have to tell this year I repaid X amount, done. That's it. I have disclosed the closing balance, but the level of detail of the information is less current year because it is not that relevant. Last year only I had given all these information. Next, now becomes it is important, sir, from here onwards. Corresponding figures are given. Generally, opinion will only be on current year amount, but in exceptional situation, my opinion will be for previous year also. On what basis? Number one, if the auditor's report on the prior period previously issued include modified opinion. Last year you gave what? Modified opinion, and the matter which gave rise to modified is not resolved. Example, last year, let's say for example, they had given wrong bad debts information. I went and told management, sir, you're disclosing wrong information, sir. They said, hey, pada. I'm like, okay, I'll give modified and leave the audit. I gave modified opinion, I left the audit. Meaning I finished that year audit. Next year, I'm only doing the audit. Now, next year, I went and told management, see, last year I gave you modified opinion and the matter which gave rise to modification, that is, your debtors, you still not rectified it. Now, you tell me, last year, because of that matter I gave modified opinion, that matter is still not resolved. What opinion I should give here? Current year. Same matter, same opinion I will give this year also. Therefore, if you see, the matter which gave rise to modification is unresolved. At that point of time, I will modify the opinion on current period FS also. Number two, in the basis of para, I should tell user now why am I giving modified opinion. In the basis, I should tell I am giving modified, nothing to do with current year amount, but to do with previous year amount. So I should tell refer to both current period amount as well as previous period amount. So I should tell the users, boss, I understand your anger, but I am giving modification not because of this year issue. I am giving modification because of previous year issue, and that issue is still not resolved. That's the reason why I am giving this year also modified. Example, Vodafone Idea. Vodafone Idea, when the case was discussed, clear, they had to pay huge sum of AGR dues, which they were not able to pay in 1 year. So that year going concern issue was there. Clear. Next year, they will still not be able to pay. Next year also I had to modify. Next year also I gave modified opinion and told why. Clear. So I have to clearly tell, why users will consider that every year this will have a problem. Right now it's not every year problem. 1 year ka problem can carry forward for multiple years, and Vodafone is a classic example for it. Understood? Okay, sir. Next. In other cases, explain the opinion that has been modified because of the effect of unresolved matter. Meaning, if you are able to quantify the amount, mention the amount. If you are not able to quantify, give the details of that particular matter. Okay. Sir, if you obtained evidence that material misstatement exists in the prior period FS on which unmodified opinion was issued. Very good, sir. Last year, what opinion was given? Unmodified, but there was a material misstatement. This year, you found out. Super. Last year, you didn't see that. That's why you gave unmodified. This year, you found that. Now, what you are supposed to do? Technically, last year is the material misstatement. Last year only, you should have given modified opinion. Did you give? No. Which one you gave? Unmodified. Now, in this year, what we are supposed to do? Verify whether misstatement was dealt properly. If the misstatement is rectified, this year I'll give unmodified. But if it is not the case, express, qualified or adverse in the current period. And in the basis you tell, why am I giving modified opinion? Because of last year's material misstatement not yet rectified, therefore affecting the current period financial statements. Understood? So technically last year what happened? Material misstatement was there, but you still gave unmodified opinion. This year you found out that step number 1, go and ask the management whether that misstatement was rectified. If yes, this year I'll give unmodified. If no, this year I'll give modified. Example, imagine last year one capital expenses charged to revenue. You didn't see that. Clear? Under repairs and maintenance they put and they closed off. Okay. Now in regular class I gave you one example of a screw which costed 2 crores. Clear? Now imagine that I put in repairs and maintenance and closed it. CA didn't see. He went and told financial statement present true and fair view. Super way of presenting the FS, sir. This year you got to know that actually purchased a screw last year only. You went and saw the financials. What they did, this year they rectified that. This year what they did, they rectified in the current year financial statements by mentioning it as a prior period item. Clear? So this year profit is restated. So what they did, this year they transferred that to capital account. They showed it as an asset and showed the effect under prior period items. And you went to management and said, last year you had one capital expense put in P&L, no? Sir, correct, sir. I understand last year we did that. You also didn't find it, no, sir? Yes, I didn't find it, but now I am finding. Now we have rectified that, sir. In our books of accounts, see, PPI we have mentioned. Okay. Then you are a good boy or bad boy? You are a good boy because you got to know your mistake. You rectified that mistake. Therefore, this year I will give you unmodified because misstatement has been rectified. Now you never touch that. You thought CA didn't see that. No, leave it. Leave it. Let it go like that only. Clear? Now in that case, this year is it rectified? No. Last year I should have given modified. Na tappu panna. I did not give modified last year. This year I will give modified because you did not rectify that. So nullified. Yes.
Also found that the capital into revenue.
How will you find? That's the point. How will you find? In the P&L I will mention repairs and maintenance X amount. That's it. No. Where have you seen invoice? You can't see that. So I can fool users better. No. In the financial statements when I give you, I'll give you P&L, I'll give you notes. In that I'll just tell repairs and maintenance under other expenses, repairs and maintenance, this is the amount. How do you know? You will not know. Clear? But possibility is there if you are a user which you have an eye for detailing. You know, in some board report or something, he'll mention that this year we had purchased one screw worth rupees 2 crore for a machinery. Now suddenly you see in the asset it is not there. You have mentioned director, you told 2 crore. Screw you have purchased, but in the balance sheet it is not there. That means something is wrong. In that case, yes, possibilities. Yes, that's the reason why he is liable, but he is liable for negligence. But if it is a fraud, I have done everything possible. Management can still conceal it. No, if management never gave me that information only, that there you can't hold me liable. Okay. If prior period FS is not at all audited, sir, what to do? No problem. I told you. In other matter, you tell that last year amount is unaudited. Sir, this is a case where the client is getting audit first time in his life. Till now, he was doing only normal audit, right? Or for example, let's say, till now he was doing partnership firm. Now he changed to company. That doesn't mean business is new, no? Only entity is changing. Right, so last year closing balance will be coming as opening balance in the current year. Yes. So when I am putting it in the current year FS as this year closing balance, last year closing balance SS. Last year closing balance is not audited. In those cases, what I should do? I should clearly tell in other matter para that these amounts are not audited. Is it wrong, sir? No, it is correct. If not, then you do one thing. Last year you do the audit first. Then you prepare current year financial statements and then put that particular amount here. But you tell me, will client be okay with you doing 2-year audit? No, client will tell, sir, this year applicable, no, you do. Or you do, I will not pay the fees. I'll pay fees only for 1 year audit. Will you do it for free? Matter what, sir? So much we learned for what? For vitamin M. Clear? Such a statement does not relieve you from obtaining SAI that opening balance do not contain misstatement. Now you know which standard is this? 510. Which comes under chapter number 4. Clear? So that's why again I'm telling you, do chapter 4, 7 and then do chapter number 8 when you are revising. Here in marathon I can do any chapter, any standard in any manner. Why? I can take an assumption that students who watch marathon or who come to marathon has already finished a couple of rounds of studies. That's why every now and then which different standard I can do. Clear? Literally I can do that. Right. Next. Comparative FS. Generally we don't follow this particular approach in India. Generally I am telling comparative information where amounts and other disclosures are included for comparison. But if I audit the previous year also, then I should refer to that year also in my opinion. Meaning, I can give only one opinion or both opinion, but I should refer to both the years. Reference should be given. Currently, if you see, reference will be given only for 1 year. Reference, if you see, only 31st March 2025, they will mention here. Although, in the financial statements, 31st March 24 also is there, 25 also is there. Opinion refers only to 1 year. But if it is comparative FS, opinion refers to both years. They will also tell 25, they will also tell 24. Okay. Now, opinion should refer to each period. Even comparative FS are presented, the opinion shall refer to each period, that is both or more. Sir, when reporting of PPFS is in connection with the current period audit, this is important. This is important. And this is important. 3 parts are important here. What are the 3 parts, sir? Number 1. When reporting on PPFS in connection with the current period, if your opinion on such PPFS differs from the opinion on current period, meaning, try to understand. 3 topics, easy to understand one by one. Focus. Number 1, if the auditor's opinion on prior period FS differs from the opinion you only gave previously on PPFS only. Example. Let us say, what is the current financial year 25-26? What is the previous financial year 24-25? Now 24-25 also I did the audit. Imagine I gave modified opinion. 25-26 la I am doing audit of 2 things. 25-26 as well as 24-25. Now you might have a doubt. Last year only you did the audit now. Why are you doing that audit in the current year again? Now my client wants me to do the audit. Why not? If my client says, sir, do the audit of last year also, sir, I only did. No problem, sir, do it again. Now in that case, there could be a possibility that my opinion will be different from my own opinion in the last year. In such a case, your opinion should not change technically, but in case if your opinion is different, last year you gave modified, this year you are giving, for last year, you are giving unmodified opinion. That means there is a 2 different opinion given for the same year. What to do in that case? Disclose the reasons in the OM para. Why are you telling different opinion? That time you told modified, now you are telling unmodified. Why? A user will get confused otherwise. That's the reason why in our country we don't follow such things. Because we know that our normal users only don't understand things here. If you confuse more with this, we will not tell only. Clear? So generally what we can do is, we can also audit 1 year twice. One in that year, one in next year. Clear? If our client wants that thing to happen, then we will definitely do it. But if the opinion is same, good. But if the opinion is different, in OM para you have to tell why your opinion is different. Number 1. Number 2. Last year audit was done, sir, but not by me. That means in the previous case, last year audit was done by me. This year, in this year I am doing last year audit. That also is done by me. How does it work? Focus. Imagine in the financial year 25-26. Okay. There is one more financial year 24-25. Now, both the years I am doing the audit. But when am I doing the audit? In the financial year 25-26. Of 2 years. Which year? 25-26, 24-25. Now, last year, in the financial year 24-25, I have to do two audits, 24-25, 23. This in the financial year 24-25, the financial year 24-25 audit also who did? I only did. Therefore, there is no change of CA. Both years I only did the audit, but two different opinions I am giving now. I am only giving two different opinions. You know how is it like? Yesterday, imagine you tasted a curry and you told it is very spicy. Okay. Today, you are tasting the same curry and telling, oh, today it is good. Now, somebody will ask you, yesterday you only told me it was spicy. Yeah, yesterday it was spicy because of these things. Now I am telling spicy because of these things. Tell that. Tell why did you change your opinion. That is what I am not saying. Don't give opinion. Boss, opinion will be different because it is subjective. What I saw last year and what I see this year could be different. Yes, some of the people in your life, you would have thought they have attitude until you spoke to them. Once you speak to them, yeah, I actually thought you had attitude. Now you are a good friend of mine. Yes, why? You had a different opinion. Now also you have a different opinion. Tell the reason why. Understood? Clear? My best friend, when we became best friends, no, initially we were not talking. Later on I asked, you were not talking to me. Why? In the first year, I can't tell the word. He's like, you were beep. I'm like, what happened now? No, now I got to know you are different. So same person, two different opinion. Possibilities there. Reasons will be different. All it matters is tell me the reason. User should know the reason. There is nothing wrong in giving two different opinions. Okay. Next. Sir, last year someone else did the audit. Opinion will be different. This year I am also doing audit of this year as well as last year. In that case, what to do? If the financial statements of the prior period were audited by someone else, in addition to expressing an opinion on CPFS, I should state in other matter para that last year it was audited by someone else. What was the opinion given by him and date of that report? Why? User should know that I did not give any opinion on last year because opinion could be different. Imagine last year Navin did the audit. He gave unmodified opinion. This year I did the audit of this year as well as last year. Now that means last year two opinions are there. One is from Naveen, one is from me. I am giving modified, he is giving unmodified. I should tell the users why am I giving modified opinion and last year I did not do the audit. Last year audit was done by someone else. He gave unmodified opinion. This is the date of his report. Therefore the user can go to last year, take out that report and check why did he give unmodified opinion, so that they will get a clarity. Karthik sir thinks in this way, Naveen thinks in this way. Now user, you take a call. Sir, I am confused, sir. That is your call. Here, you want to buy Samsung 25 Ultra, you want to buy iPhone 17, both are there. You take a call. Whatever you want, you buy. Similarly, whichever company you want to invest in, you invest in. Take a decision. If you conclude that material misstatement exists, now this is very good because there are two CAs. There are two CAs who have given opinion on 1 year. Clear? Now the question is, if I conclude that there is a material misstatement existing that affects the PPFS on which previous CA had given without modification. What is without modification? Unmodified opinion he had given. You shall communicate the misstatement with management or TCWG and ask the management that please tell the X that something is wrong here. I will not talk to your X. Why should I talk? You are important for me, not your X. So I will not talk to your X. I will tell you, you go and talk to your X and ask him to change the opinion. Now, if PPFS are amended, that is financial statements are amended, predecessor auditor agrees to issue a new report on the new FS, then no problem. I will report only on the current period. What is happening? Same year, two different CAs have given two different opinion. Now I am the in charge of current year FS. In the current year FS, I got to know something is wrong. Right? Now in the previous year FS also something is wrong. Now that PPFS wrong only is coming and haunting me in current period FS. Now last year I can't change the opinion because I never gave the opinion. Who gave the opinion? X gave the opinion. So I can't do anything about it. I will go to management and tell last year financial statements you have done this mistake da. Clear? Last year FS, you have done this mistake da. Now the question is management they have to take a decision whether we should change our FS or not. If they change the FS, then X should issue a new report because the report is based on what? Financial statements. If FS is changed, then even report should change. And last year, who gave the report? X gave the report. Therefore, who should change? X should change. If he changes the report, good. This year only, I will give the report. But what if he doesn't change? This year, I will change. Last year report also, this year report also. Understood? In totality, in current year, 2 opinions should be given. One is for previous year, one is for current year. If previous year audit was done by me only, these complications won't come. Because you tell me, I will change. This year also I am doing, I will change. But if last year someone else had done, I will tell the management, you have done something wrong. Now, if management changes the FS, they should go to X. Tell the X that, see boss, we have changed the FS, you have to change your audit report. If X changes the audit report, my job is only for current period. If he doesn't change the audit report, my job will be for previous year also, current year also. Got it? You know what is this? This is SA 560. SA 560 talks about what? Subsequent events. But this is SA 560 for X, not for us. Because last year, who did the audit? X. When is he getting to know about misstatement? After his own report. So, for him, it is SA 560, not for me. Understood? For me, it is not SA 560. For me, SA 560 is this. Where last year, I only did the audit. This year, I am doing the audit. 2 different opinions I am finding out. Therefore, I will only change the report. Clear? Next, sir, what if last year financial statements were not at all audited? Very good. No problem. In other matter para, mention that last year it was not audited. But still, you have to follow SA 510. Opening balance, you still have to check. That doesn't give you right that, sir, anyway we are putting OM para, no. Randomly put one amount, sir. No. Check and put. And then give OM para. Clear? Sir, is it only the predecessor auditor gave unmodified opinion? Yes. Correct. In this scenario, yes. Because last year, audit was done by someone else. Whether those 2 opinions will be given on the basis for opinion para? No. In these 2 opinions, he will give a new report. So, I will not touch that report. In the current year, I will give my report in my opinion para, and in the basis for opinion, I will tell why I gave unmodified or why I gave modified opinion. In other matter, if you want, you can tell last year it was done by someone else and he had given this modification. Give these things, his name, what opinion he had given, and when was the report given, so that you can go to their database, extract that report, read that report, and take a decision. Got it? Online. Meena, solved your doubt? Yes. This is with your SA 700 series. Clear? So, in reporting, important part is SA 700 series. Clear? And then, in that, the main base is SA 700 and 705. Rest everything is extra information. That is, SA 701 is extra. 706 is extra. In the 2 para, EOM and OM is there. 710 is a way of presenting the financial statements. Corresponding figures and comparative financial statements. Clear? Yes, sir. Now, in section number 143, I want to talk about important things alone here. Point number 9 talks about IFC, Internal Financial Control System in place. Now, what is this? Here I want you to understand 3 things. Clear? Number 1 is a bigger circle. This bigger circle is talking about internal control system. Clear? So, internal control system is for every department, finance, non-finance, admin, business, everything. Everywhere we'll have ICS. Clear? Number 1. Number 2, there is a smaller circle in this. There is a smaller circle in this. This smaller circle is what we call as IFC. Internal Financial Control. This is nothing but internal control system only for financing, that is assets, operations will not be including here, only safeguarding of assets, financial reporting, those things are what we talk about in IFC. There is one more circle inside this. This is called ICOFR or IFCFR. This means specifically for what? Financial reporting. So ICS is a bigger concept. IFC is bigger than ICOFR, smaller than ICS. ICOFR is the smallest. So these two are subsets. These two are subset of ICS. Clear? Because ICS covers financial plus non-financial, operational plus non-operational as well. Clear? Whereas IFC is only focusing on what? Financial department. And ICOFR specifically financial reporting part. Now what is financial reporting? The way financial statements are presented and prepared. Clear? So schedule 3 and all will be coming under this department. So proper control systems are there for ICOFR alone. We have to focus in our reporting. Clear? Why am I telling this? Because of this part. See, whether the company has adequate internal financial control systems in place and the operating effectiveness of such control. IFC talks only with respect to what? Financial department logic. But if you see the next one, however, it may be noted that reporting requirement on adequacy of IFC with reference to this IFC with reference to FS is what we call as ICOFR or IFCFR. So only IFCFR is where we have to give opinion. Only on this we'll be giving opinion. On IFC, no opinion. On ICS also, no opinion. Opinion is only on what? ICOFR. Remember that way. R stands for reporting. Therefore, we'll have to give opinion on that. IFC, no opinion. ICS, no opinion. Opinion is only on ICOFR. Sir, but they have mentioned IFC, no sir, here. Correct. They mentioned IFC. What they mean is IFCFR, because if you see here, they have clearly mentioned with reference to financial statements. So two opinions will be giving. One opinion is on financial statements. One opinion is on IFCFR. Understood? Why that IFCFR opinion we give? Because Companies Act has asked us to give an opinion on that. That's the reason why we are giving two opinions. Clear? But it is not applicable to three types of company, which is that one-person company, small company, or a company having turnover of less than 50 CR as per financial statements, and borrowing from banks or FI or body corporate at any point of time less than 25 CR. That means this company means it could be a public company or private company. This company, which company is this? It has to be private, because if you see here, shall not be applicable to a private company. Meaning for all public company it is mandatory. Clear? Only for private company exemptions are given. Which private company? OPC, small company, and those companies whose turnover is less than 50 CR and aggregate borrowings from bank, FI, body corporate at any point should be less than 25 CR. I again told you, turnover is the highest. Clear? Here paid up capital is not there. In MCQ I can confuse you. Remember, in IFCFR requirement, paid up capital is not there. It's only turnover and borrowings. Clear? Okay, sir. Now, section 143, subsection 12, which talks about fraud. Talks about fraud. Now, what do you mean by here reporting of fraud, sir? Depending upon the amount. If the fraud is less than 1 CR, reporting is required but not to government. If it is more than 1 CR, reporting is required to the government as well as to the company. If it is less than 1 CR, then fraud reporting will be only to board of directors or audit committee. If it is more than 1 CR, then we'll be reporting it to central government. Clear? Yes. Now, where, sir, in case of central government, will be reporting it to Ministry of Corporate Affairs Secretary. clear, of secretary of that ministry will have to report in form number ADT 4. Now focus here, step number 1, step by step I will tell, clear. Don't be busy in painting the book, try to focus on the content. Step number 1, the moment I get to know about the fraud, first of all, is fraud finding my responsibility? No. But if I find a fraud, reporting, is it my responsibility? Yes. Now that is where this is a duty now. Clear? The section only says powers and duties, and 143 reporting will be a duty. My question to you, the moment I find the fraud, within 2 days of my knowledge, I should go and tell board of directors or audit committee, number 1. Number 2, I should wait for 45 days. Clear? I should wait for what? 45 days. They will have a 45 days time to reply. If they reply, if they don't reply, 2 outcomes will be there. If they reply, I should send the reply of board of directors, my reporting notification, and my response on their comments. These 3 things I should send it to central government. Clear? One is the report which I gave it to BOD. Second, whatever they replied, that also. Third, my comments on their reply. This I should send it to central government within 15 days of receipt of reply. Clear? 45 days time they have. Tomorrow only they replied. Within the next 15 days I should report it to central government in form number 884. To whom? Secretary of Ministry of Corporate Affairs. In what mode I should send? Registered post acknowledgement due. Clear? What mode? Registered post acknowledgement due. Now they said, if you want, you can file it in electronic format. You need not send it also, no issues. Clear? So now you can directly file it in EADT4 and send it to MCA, no problems. Clear? One PDF is there. Fill that information and give it. What I should tell them, sir? Nature of fraud, amount of fraud, clear, parties involved, who are the parties, and what actions the company has taken. These things I'll have to tell the central government and they will take it forward. I have to report in my letterhead though. Clear? I have to report in my letterhead. They have removed that also now, because directly you put it in the, there you have to give a certification by CA. So directly you put it there. Tell me what all requirements are there in 84. That only you give it to MCA. They will take care from there onwards. If it is less than 1 CR, MCA will not be involved. Law says you have to tell only BOD and audit committee. What board should do? In their board of directors report, they should report nature, amount, parties. What is the fraud? Who is involved? And what is the amount involved? Clear? Understood? Therefore, this particular point talks about financial fraud. What fraud? Financial fraud. Non-financial fraud and all, I'll not be bothered about it. Clear? So if it is 1 crore or above is being or has been committed in the company, report to central government. So more than or equal to 1 CR, if it is there, we'll be talking to whom? CG. That means less than 1 CR talks to whom? Board of directors or audit committee. Understood? Clear? That's the entire process. The entire lengthy text is because of that only. Okay, sir. That is your section number 143 subsection 12. Clear? Yes? Fine. We'll take a 10-minute breather and then we start with chapter 7 content. Our SA 560, 570, 580 standards. Clear? Next, chapter number 7, that is completion and review. We have multiple standards to talk about here. SA 560, 570, 580, 450, 260 and 265. Basically, 6 standards are there. Clear? SA 560 becomes a very important standard. Alright, compared to the other standard here. I'm not saying other standards are not important. 560 and 570 are good standards. Now, SA 560 talks about subsequent events. Clear? Now, subsequent events here, if you are doing SA 560, it is better if you have a knowledge of accounting standards 4. Now, there will be one question from you. Sir, I am writing only group 2. I am not writing group 1. So, I have not touched group 1. Clear? Now, you writing group 2 or group 1 is technically not ICA's problem. Clear? ICA has designed the syllabus in such a way that audit is there in group 2 for a reason. Clear? Audit is there in group 2 because it has the flavor of accounts, law and tax. So if I put this in group 1, you will not understand anything. So finish off group 1 and then come to group 2 is what ICA says. You writing group 2 is decision of the student and not ICA. So that ICA says it is not my problem. It sounds like a you problem and not a me problem. Clear? So here this will be much better if you have a AS4 knowledge on this. Having said that, AS4 talks about what? Events occurring after balance sheet date. Same logic here, SA 560 talks about subsequent events. What happens in subsequent events is there are three different dates here. One is called financial statement date and one is called date of audit report, and then we have date of AGM. Rather than date of AGM, you can say date of, yes, issue of financial statements. Clear? Now there are two things. One is called events which we have to bother about and one is called facts which we have to bother about. Now whenever we talk about events, those are events which occur after a balance sheet date, that is after financial statement date but before audit report date. So anything which is between financial statement and audit report is what we call a subsequent event. No, subsequent event are two things. One, anything that occurs between financial statement date and audit report date, and anything that occurs between audit report date and financial statements issued. In fact, even after financial statements issued, any matter we get to know, that also will be coming under subsequent events. Clear? Now, what do we need to bother about? Listen to here. Events and facts are there. We need to bother more about events. Clear? Because this comes between financial statement and audit report. That means we have not yet finished the audit, which will affect our audit opinion. Once we sign the audit report, our job ends. Clear? So for these events that occurs between financial statement date and audit report date, for that what is our objective? We need to obtain SAI. If we need to obtain SAI, that means we have to put up the procedures in place, which means we have to design procedures for this as well. So obtain SAI about whether these events, whether it requires adjustment or it requires disclosure. Sir, in AS4 you have studied an event called as adjusting event and non-adjusting event. Adjusting event requires adjustment, non-adjusting event requires disclosure. Same logic here we have to understand. If it is an adjusting event requires adjustment, if it is non-adjusting event it requires disclosure. So we have to put up the procedure and get evidence whether for events that is adjusting, have you made adjustment? For events that is non-adjusting, have you made disclosure? We are not supposed to do it. We are not supposed to do it. Who is supposed to do it? Management. We should just obtain SAI. Whether they have done these in the financial statements. And if they say yes, should we directly believe them? No. Whether it is reflected in the financial statement. Now this is the point where student will miss out on. Student will write this one. We have to obtain SAI whether they have made that or not. Not just obtain SAI about the adjustment and disclosure. Go and check in the FS whether they have reflected in the financial statements or not. Got it? Okay. Now, what is a procedure? We have to put up the procedure because there is SAI. What procedures we have to put? Number one, determine the nature and extent of audit procedures. What type of audit procedures we have to put? Number two, consider the risk assessment. Is it risky or more? If it is high risk, that means I need to check more. If it is less risky, I need to check less. Include the following. Obtain understanding of how management identifies subsequent events. Meaning, again I am telling you, whose responsibility is preparation of FS? Therefore, whose responsibility is accounting standard following? Management. Clear? So, who should adjust the event? Management. Who should disclose the event? Management. That means who should identify the event first? Management. Because we do audit after financial statement. So management should identify the event first. We need to go and ask the management, how are you identifying? Do you have a process? Do you have a team? Do you have a department? How are you identifying these subsequent event? Management will give you an answer. Inquire management or TCWG about any events that affect the FS. Step number one, I will ask, how do you identify? They will tell you the process. Then ask them, have you identified any events that is affecting the financial statements? financial statements that two events affect. Number one, adjusting event. Number two, non-adjusting event. Clear? So I ask them, is there any event that is affecting the financial statement? They will give you an answer. Should I blindly believe them? No. Go and read the minutes of the meeting. Which meeting? Owners meeting, TCWG and management. Why? If it's the event that is affecting the FS, you tell me the logic here. FS would have already been prepared. Yes. Now the FS is in the hands of auditor. Yes or no? Because who's checking the FS? CA. When? After 31st March. Now, don't you think if anything they get to know which is affecting the financial statements, first they will call a board meeting and discuss what to do? Yes or no? Therefore, read the minutes of the meeting. Owners or TCWG or management, ask and see what they have decided in the meeting. They will tell, nothing is affecting, sir. I will not trust you. Give me the minutes book. Clear? Then, minutes also possibility that they have not disclosed properly. So, read entities, latest financial statements. If there is latest financial statements. If there is no, nothing can be done. Sir, if the event is identified, determine whether that event requires adjustment or disclosure. Which event require adjustment? Adjusting event. Which event requires disclosure? Non-adjusting event. So, step number 1, determine what type of procedure. Step number 2, identify your risk assessment. Step number 3, number 1. In that step number 3, first is obtaining understanding. Second, inquire. Third, read. Fourth one also read. So basically 3 steps. Understanding, inquiring, reading. Clear? Then, whether it is appropriately reflected or not, whatever events they have adjusted or disclosed, go and ask them where is it adjusted, where is it disclosed, show me. Clear? Then finally comes the legendary standard essay 580 where you are requesting WR from whom? Management or regarding the events whether they have adjusted or disclosed. They will tell, sir, we have done it. We have checked also, but still we can take it in writing. Clear? These are the 5 steps. Step number 1 is what? Getting to know what type of procedures you will put. Number 2, risk assessment. Number 3, with respect to management. 3 points. Understanding, inquire and reading. Reading 2 things, minutes of the meeting and interim financial statements. Then step number 4, go and check whether they have done whatever they have told or not. Clear? Step number 5, take it in writing. Next, with respect to the facts. With respect to the facts, what objective we have? We don't have to obtain SAI, we have to respond appropriately to these facts. Had it been known at the audit report date, I would have changed the audit report, sir. Sir, I finished my audit report here. The moment I signed, I finished my audit report. But, listen and try to understand. I signed the audit report. The question is, have you issued it? That is a question. Signing is different. Signing and issuing is different. If I have signed and not yet issued, the copy original is with me only. I can change and give. But if I have signed and issued, now I have lost control of my report. Clear? So, I have to respond appropriately because I told you once you sign the audit report, you can't do any extra procedure, neither obtain any new evidence. Clear? We have seen date of audit report. After obtaining SAI only, there should be the date of audit report. So here you have to respond appropriately to these facts. Had it been known at audit report date, I would have changed the audit report. With respect to those facts, number 2, what I should see? First, check whether financial statements are issued or not issued. If the financial statements are issued, what to do? If the financial statements are not issued, what to do? In either case, the moment you get to know the fact after the date of audit report, step number 1, go and discuss the matter with management. Ask them, what are your plans? Anything you got to know after audit report, go and ask the management, what are you going to do? Clear? Brother, what are you going to do? And if they say whether financial statement requires amendments, if yes, ask management how are they going to do that particular amendment. If they are saying amendment is required, sir, okay, how are you planning to do it? When are you planning to do it. Clear? Forget about this. Tell me logically. My report is on the financial statement. My report is basis what is a financial. If financial statement management change, should I change my report? Yes. If they don't change the financial statement, should I change my report? Yes. Moral of the story, whether they change FS or not, I should change my audit report. What is the logic behind this, sir? What is the logic behind this? The logic is very simple. Is there a matter that I found out? Yes. When did I find out? After audit report. Now, if this doesn't affect FS, no problem for me. But if it is affecting FS, it is a matter which affects financial statements. Now, who should change the financial statements? Because who is preparing that? Management. So, changing the FS is not my job. Clear? But audit report has to be changed. Now, I have to give that opportunity to management to ask them, are you changing or not? If you are changing the FS, I need to change my report. But if you are not changing the FS, tell me, I need to modify my report. Because my report is wrong now. Your FS is missing some important information, and based on that only I gave my report is wrong. You change your FS, I'll give good report. You don't change your FS, I'll give bad report. In either case, I'll have to change my report. Clear? So first I will discuss the matter with management, determine whether FS requires amendment, and ask the management how they are going to change it. Let's talk about if FS is not issued now. If financial statements are not issued, then I should ask management, are you changing your FS? If you are changing your FS, extend the procedures to the changes, meaning audit those changes. Don't blindly believe them. Go and check the changes. Once it is done, change your audit report. How should I change my audit report? Include additional date of amendment or provide a new report with the EOM or OM para. This additional date of amendment concept only is what we call as double dating concept. Now, double dating concept is not the concept which you guys are thinking. We are talking about audit report. Clear? Basically, here you have two dates. One is your old one is your new one. Now, it will be confusing. Right? Rather than that, what is better? Withdraw the old one, give a new report with one date only. Understood? Clear? Okay. This is when the financial statements are not issued and management amends the financial statements. What if management is arrogant? I will not amend FS, do whatever you want. No problem. See whether audit report is yet to be given or not. If it is not yet given, like I said, signed but not yet issued, cancel that signature, modify the opinion and give a new report. What if I have given the audit report, then management says, now what you will do? No problem. I will ask TCWG, please do not circulate it to the third parties. Now TCWG says, I will do it, what you will do? No problem. Even if you still go and issue, I will give a public notice. Saying, imagine CA coming out and telling, don't rely on my report. That means public will definitely not rely on my report. Users will ask questions to you. Why that CA is telling don't rely on his report? Now who's answerable? Management. Go and answer your users now. Clear? So process is very simple, right? If financial statements are not issued, there are two scenarios. Are you changing your FS or you are not changing your FS? If you are changing your FS, good boy you are. I will audit those changes and I will give you a new report. But if you are not changing, you are a bad boy, therefore I should give bad opinion about you. Yes, and if it is not yet issued, I have given good opinion for a bad boy, I will tell TCWG, don't circulate it to the third parties, don't give it to ROC, etc. If they still give, take appropriate action to prevent reliance, which is a better option. Give a public notice and finish it off in case if they breach your word. What if financial statements are already issued, sir? Very good. If the FS is already issued, review if management has taken steps to inform everyone who has received the financial statements. Ask management, have you told people? If they say yes, then issue new report with EOM or OM para. If they say we have not told, that means you are a bad boy. You have not disclosed the fact. Where is true and fair view? I will take appropriate action to prevent Reliance, because if FS only is issued, AR also is automatically will be issued. Audit report also will be issued. Clear? This is the entire concept of SA 560. But if you go to ICA material, there are multiple charts given. Clear? Where they are talking, what they mean, and therefore SA 560 skip from a normal student's perspective. Clear? And question will be asked on this. When they ask a question on this, you don't know what to do with this particular concept. Concept is absolutely easy. You just have to, I told you in regular class, I train the students. Any question on SA 560, first to see which basket it is falling. There are two baskets. One is event basket, one is fact basket. If it is event basket, my work is more. If it is a fact basket, my work depends on management. If they change FS, I will have to change my report. If they don't change FS, I will have to go and tell the public the same, don't rely on my report. Clear? So if events, generally they will ask events question because your procedure is more there. 5 steps procedure you have to put. What is this 5 steps procedure? Decide your procedure, consider the risk assessment, then with the management 3 things, URI, understand, read, inquire. Clear? Understand the process. Clear? Read 2 things, minutes and interim financial statements, and inquire with the management whether they have identified any event or not. Then if after that, go and check whether they have done it in the financial statements properly or not, and finally take it in writing. Right? Now, what do you mean by date of financial statements issued? It could be AGM in case of company. Basically, wherever you are making it available to third parties depends upon regulatory authority. In some cases, date of filing with SEBI, filing with MCA is what we call as third party issuing, because the moment you file with ROC, it becomes a public document. Date of issue should be on or after a date of audit report. Clear? You can't issue FS before audit report date. Therefore, issue has to be with audit report. Understood? Clear? On this I can draft a case for you. So don't be careful in those cases. Check when was the date of issue. Date of issue of FS should be after date of audit report. Understood? Clear? This is the entire concept of SA 560. Flow should be there in the concept. Event and facts. Now with respect to the fact between audit report and financial statements or anything after audit report will be called as a fact for me. Now fact I have no responsibility because my audit is over. My responsibility is totally dependent on your changes. Clear? So first I will go and ask the management, what are you going to do? Clear? If you are going to change, how are you going to change? Now if they change the financials, what should I do? Audit the changes first, change your report. If they don't change the financials, if we have not yet given the report, stop giving, modify and give it. If you have already given, tell them not to give it to third parties. If they still give it to third parties, public notice கொடுத்துட்டு, you have to stop that. Clear? Now, what if financial statements only are issued, sir? Both of you got to know later. No problem. Ask management, are you informing them? If you are informing them, I will change my opinion and I will give a new report. If you are not telling them, I will tell the public, do not rely on my report. Logic here is, my report is totally based on financial statements. If your financial statements are not good, I should change my report. If your financial statements are good also, I should change my report in this particular case. Be careful. Okay. Next, SA 570 talks about going concern. Now, these notes for chapter 3, chapter 4, chapter 7, all standards, the important standards or heavyweight standards in the regular class we have done with exclusive class notes. Now, this will not be shared to anyone through soft copy basis. You can copy this at your own convenience by pausing the videos. Those who are seeing on YouTube, you can pause it and copy this, no problem. This is purely exclusive for class. Reason is being, the notes will be circulated left, right and center. Recently, I dropped one email to one of the websites which used my material without cropping my name. Clear? They have taken my name, they have taken academy's name and they have circulated that. Clear? Luckily, some student came and told me, I dropped an email, I just gave them an opportunity before I take legal action, and luckily they removed it now. Clear? Now, like this, there are many websites. I can't keep on searching each and every website and go and file a case on them. Clear? So, because of that, it has taken a number of hours for me to create this. Huge number of hours and efforts were involved to make it as easy as possible for a student. So soft copy will not be possible. You can copy it at your own convenience in your notes. Absolutely no issues. SA 570 Institute's favorites standard. Favorite standard institutes. Going concern. What do you mean by going concern? Expecting the company to survive for a. Now this word is very important. If you say future, it is not future, it is foreseeable future. Now what I mean by foreseeable, is future certain? Is foreseeable future certain then? Is foreseeable future certain?
Reasonably certain.
Relatively it is certain. If I ask you tomorrow what you are doing, you can tell me exactly. If I ask you next week, same day, what you are doing, you can still tell, but the certainty will decrease. If I tell you after 6 months what you are doing, same day, certainty will decrease further. If I ask you 5 years down the lane, tell me December 9th, what you will be doing? Certainty is absolutely gone. If I say 10 years down the lane, certainty is absolutely gone. In interview, they'll ask you this question, where do you see yourself in 5 years? Clear? As an accountant, I will answer. It's an unreasonable going concern you're asking. You tell me 1 year down the lane what I'll be doing. Clear? Now interviewer we'll be playing Uno reverse. Clear? You ask interviewer 5 days after what you'll be doing at 6:30. You tell me. You can't tell me 5 days only, and you want me to tell after 5 years where I'll be seeing myself. Clear? Future is very uncertain, which means you take an assumption. Good, but if you're assuming, sir, long way. Absolutely uncertain. Even I thought when I started CA, 5 years down the line, I'll be a CA. Clear? ICA said, boss, we believe in foreseeable future. You believe in future. Clear? And ICA told, you told 5 years, no, take 10 more years. Clear? I took 10 years to become a CA. Clear? That means a student who can become CA twice. I took both that year and I took only one particular decade to become one chartered accountant. Clear? So my assessment is totally different, right? Someone else's assessment is totally different. Now if I see my students are becoming CA at the age of 21, 22, 23. Clear? That year I was writing my intern. Alright. Why? Because the assessment we have taken is totally wrong. So whenever you're assuming, you assume. Future is assumption, but it should be a reasonable assumption. And standard says, see, I can't tell you your certainty, but at least for minimum 12 months, you should see whether you have a future or not. Because users want to know whether you have a future for at least next 12 months or not. Sir, can I say for 5 years? No problem. 3 years? No problem. 6 months? Problem. 8 months? Problem. Minimum to minimum 12 months. Clear? Why this minimum to minimum 12 months? In CARO we have seen where financial asset and financial liability clause, where you have to talk about solvency of the company for 1 year from the balance sheet date. And if I tell you, you only judge for 6 months, there is inconsistency in reporting and assumption. Therefore, minimum to minimum how many months? 12 months. Okay. Now, in which the entity prepares the FS. Therefore, FS is what? Based on this assumption only you prepare FS. Now, who prepares FS? Management. Who takes care of monitoring part of it? TCWG. Okay. If GC assumption becomes inappropriate, what you should do? You should prepare the FS on liquidation basis. What do you mean by liquidation basis? Not accrual anymore, because you are expecting yourself to not live. Clear? Simple logic. A person who is having cancer versus a person who is healthy, who lives a life to the fullest? The person who has cancer. Why? Because he knows that if the doctor has told that you are not going to live for a foreseeable future also, there is no point in pushing your dreams and aspirations. Next year we'll do that, day after that we'll do that. No problem, because now only we'll do everything. That's called liquidation basis. Company should prepare on liquidation basis. Clear? What is liquidation basis? Nothing but cash basis. Clear? Okay. What are the objectives of SA 570? To obtain SAI and to report. To report as per what? SA 570 only. Left, right, center, you can't do your reporting. You have to give reporting as per this standard only. So to obtain SAI with respect to what? Whatever management has used going concern assumption, is that assumption appropriate or not? Example, sir. let us say Nokia and other competitor called Samsung. Now Samsung came into the market when Nokia was ruling. Yes, Nokia was the king of phones before. Why did it spoil? Because they did not change due to the market condition, and Samsung changed due to the market condition. Now the question is, when I'm asking Nokia, sir, will you survive for the next 1 year? Yes, sir, nothing will happen. Sir, on what basis? Believe me, sir. Sir, correct, but on what basis? Chumma, sir, no one can destroy us. We are king of this sector. That means whatever assumption you're taking is inappropriate. Because there is no basis for your assumption. But if you tell that, sir, I understand Samsung is there, sir, but we are working on different technology, we will survive the market, sir. That means now whatever assumption you're taking is appropriate. So they will take assumption. You need to obtain evidence with respect to their assumption. That's it. Second, obtain SAI to conclude whether any MU exists, material uncertainty exists. What is material uncertainty? Those events which will have significant doubt about entity's ability to continue as going concern, meaning those events which affects your continuation. Example, sir, a CEO of your company leaving and you are not finding any replacement. Uncertainty. Creditors withdrawing their support. Uncertainty. You are losing a major market. Uncertainty. Strong competitor coming into your segment. Uncertainty. Tomorrow, if Reliance comes to education sector and starts a coaching academy, will it be affecting ArivuPro? Will it be affecting ArivuPro? Huh? How is it indirectly affecting? Directly, no. If Reliance starts tomorrow, Reliance Academy, will it affect? Yes. But does that mean ArivuPro will go out of competition? No, we need to talk to management. How are you planning? Now they'll tell, don't worry, sir, we'll plan. We have these plans, in pipeline, and no problem if any strong competitor comes, we will still be surviving in the market. Now I have to evaluate their plan, and I should see whether their assumption is appropriate or not. Because in future, uncertainty will definitely be there. We are not bothered about all uncertainty. We are bothered only about material uncertainty, which will give us a doubt that you will continue or not. Clear? Now, for that objectives only, we need to understand what is a responsibility. Here, my responsibility is damn easy. You know why? I just have to check whatever management has done. So, whose responsibility is very important? Management. We have to understand their responsibility first. So, first ask management, are you preparing FS based on GC, even if the framework does not require? Whether law says or law does not say, irrespective of it, you have to prepare your FS on what basis? Going concern assumption. Now, if you want to write somewhere else, one statement you write, GC is a requirement. GC is a requirement irrespective of law. GC is a requirement irrespective of law. Basically, it is a basic assumption that we take. Whether law asks you to do it or not, you should still do it. This includes making judgment about the future outcomes, results of events or condition. So, management should consider these 5 factors. What are the factors? Number 1, size and complexity. How big is your company and how big is the uncertainty? Clear? Complexity. Whether the business that you're doing is very complex or not. Imagine a competitor is there, but his business is less complex than yours. People have not yet cracked your model. That means you can still survive in the market. Nature and condition of the business. What type of business you are doing and what is the condition of your business? Are you at your peak or are you at your downfall, etc. compared to the market factors? Sensitivity of the business to external factors. Meaning what, sir? How sensitive you are to government changes, how sensitive you are to competitors, how sensitive you are if a creditor withdraws the support. Clear? Imagine if the creditor says tomorrow onwards I will not supply raw materials for you. No problem. If you are not there, someone else is there. That is exactly why in organization, no, they will not rely only on one creator. They'll have multiple creators. So that we should not be dominated by one person. Clear? Then degree of uncertainty increases significantly the further into the future. Like I said, tomorrow you'll be able to tell me what you're going to do. Day after tomorrow you can tell me your plan. 6 months down the line, can you tell me your plan? No. 6 years down the line, can you tell me your plan? Absolutely not. So the more farther you travel into the future, uncertainty level keeps on increasing. So therefore they are saying, don't tell me 10 years will be surviving on. Next 1 year can you survive? That you tell me. Clear? There could be changes in the information available based on which GC judgment was made. Meaning what? Sir, imagine I made the first judgment in the month of April 2023. The next judgment I am making on March 2024. The information available in the beginning is definitely not equal to information available as on March 24. Government changes can happen. Election can happen. Government can bring up new rules and regulations. For example, in Karnataka, hookah business was banned. Clear? Now imagine suddenly in between the year, government came up with the notification saying hookah business is banned in Karnataka. Now my restaurant is only hookah bar. Right? 90% of my revenue is based on hookah and 10% is based on the food. Is it affecting my business now? 100% yes. But when I asked the management, they said, no sir, in April we assessed GC, no danger we had. Government came notification in the September. Now you did the assumption as on April. After that, did you make any assumption? No sir, I didn't check the information. Go and check. Now there is a going concern problem. Now they have to design a new strategy for survival. Clear? Gujarat, liquor ban. Clear? Imagine suddenly government came up with a ban on liquor. My business is gone. I need to devise a new plan. Clear? That is the reason in some of the cases you see most of them have bar and restaurant business. And they say my restaurant business is, the proportion of restaurant will be bigger than bar. But yes, the bar business will be much higher because two things. See, government will not ban two things. Alcohol and tobacco. Clear? Although some of the states can take a decision of banning the alcohol and tobacco, but not every state will do it. Why? Government gets more revenue from these two only. Clear? That is why they will not ban. But if it banned, no, then it is good for everyone. Now, what is the procedure? We'll have to two procedures will be there. One is called basic procedure. One is called additional procedure. Now, what is the basic procedure? Very important. Additional procedure, no problem. Nothing but reading the documents. Clear? Basic procedure is very important. What is the basic procedure? First, ask management whether they have performed preliminary assessment or GC or not. If they have performed, discuss the assessment with the management and ask whether events and conditions have any doubt which can harm your going concern. If the management says, yes sir, we have identified events and conditions which will harm them, ask them how are you going to address them. What is the resolution that you guys have decided? If you have not done the assessment at all, ask the management on what basis you are assuming that you will run the company when there is a strong competitor outside. Nothing, sir. Astrologer has told us. Nothing will happen to us. Clear? My numerology has told. Nothing will happen to us. They lose tool. How can you believe on astrology and numerology? On that basis, I should invest or what? No. So discuss the basis for use of such going, not assessing GC. Inquire whether there are any events or conditions that cast doubt on continuation because some are overconfident. Imagine you went and spoke to Nokia and you asked Nokia, the new tech came, no, what about your assessment on that? Nothing will happen, sir. We are king of the segment. No one will throw us out. Clear? What will happen? What happened now? They didn't throw the product out. They threw the company only out. Clear? Therefore, Nokia is no more to be seen. Yes, Samsung said, no, we will bounce back. Classic example for going concern bounce back is Nestle. Maggi. When the lead content was there in the Maggi, when acquisitions were made, clear, they were down to 0% market share. Who purchased Maggi after that? No one. It was a very good opportunity for a competitor to enter and sweep the market. But they did. Maggi came back strongly. Currently, From zero, they're holding 60% market share. How? Ask the management, how did you do this, sir? Clear? And that is when, I don't know if you remember, after the accusation when Maggie came out with it, they stopped a new flavor called curry. Previously, Maggie used to come up with a flavor called Maggie curry flavor. One was normal flavor, one was curry flavor. They discontinued curry flavor and they brought a special Maggie with the red packet now. I don't know if you observed it. You observed? Normal yellow packet is there and one normal red packet is there. They try to bring new things. Clear? So we need to ask them. Now see, for example, Tata. Tata brought EV segment vehicle, first to launch EV segment vehicle. Correct? Other people are figuring it out. So we need to go and ask them, see boss, EV segment has been released in the market. What is your plans? Sir, we are also working on it, sir. Now Maruti, Suzuki and Toyota came in with a arrangement. Right? So hybrid model we will have, EV model we will have, and on the other hand, Tata Motors coming up with left, right, center models. Clear? Tiago EV, Nexon EV, this EV, that EV. Papa, they are figuring out one model. Here they are bringing 3, 3, 4, 4 models. So we need to ask Maruti Suzuki, Toyota, Honda and all, what is your plan for this? Are you planning to survive this particular wave or are you trying to close it down? So we need to ask them. Next, evaluation of assessment of ability of GC includes what? Ask their process. How are you identifying the events and assessing? Management's process. What are your assumptions? And those assumptions should be absolutely, sir, can assumptions be correct or should assumption be reasonable? Assumption should be, why reasonable? Because it is future oriented, therefore your correctness will not be there. Ask what are the plans for future actions and whether those plans are feasible or not. Okay. Now, what is the minimum period of assessment? 12 months from where? Date of financial statements. You have to cover the same period as management. So, if management has assessed for 12 months, I should evaluate for 12 months. If management has assessed for 24 months, I should evaluate of 24 months. If management has covered for less than 12 months, request them to extend it for 12 months and then remain alert throughout your audit because you never know when what information you will see. If assessment is not made, ask management to make the assessment because you have to make going concern assumption. Clear? Now, if somebody comes and asks me, Karthik, what are you doing next year? I can't say I don't know. Clear? I need to have a plan for next year because you're a professional now. Clear? So you need to understand next year where, which month, what, where I will be. I should understand based on that only my decisions will be taken. As a businessman, you can't say that I will, YOLO, you only live once, today I will survive. Companies will have 5-year plan, 10-year plan. Clear? They will assess till that extent. Clear? There's a company called Motherson Sumi. Clear? Motherson is one Indian company and Sumi is other company. They got merged later. Clear? Motherson company was started by two people, mother and son. Clear? They started that company. That's why they gave the company name as Motherson. This company has 5-year plan. Clear? They put a 5-year plan, they achieve it. They put a 5-year plan, they achieve it. They achieve it in 3 years, 4 years, etc. So if you go and read their annual report, no, they have a 5-year plan. Now 2025, they have a 5-year plan, Mission 2030. Then they have Mission 2035 and they'll give you an idea what we are going to plan. That means they are thinking about future, no. So is that assumption valid? Yes, because period is minimum. Maximum any month, whatever suits you, 5 years, 5 years, 3 years, 3 years. Clear? Consider additional fact and information that is available since their last assessment. Basically, updated information we require. Okay. Obtain WR from management with respect to plans and feasibility. Okay. Next, if cash flow forecast is prepared, evaluate the data reliability and determine the support for assumptions made. Meaning, imagine as a going concern, I am telling you that next 12 months, this is what we are planning, sir. Sir, if you're telling me next 12 months, monthly revenue you will be telling me, monthly expense you are telling me. So if the cash flow forecast is prepared, forecast is a PFI. What is PFI? Prospective financial information, which is always based on assumptions. Clear? So I need to evaluate the reliability as well as ask the support for assumptions taken. Okay, sir. Now, what additional procedure I should put? Basically, reading the agreement, minutes, confirming the enforceability, inquiring the entity's legal counsel, etc. These, even if you don't do, no problem. But these has to be done. Clear? And the question, more often than not, they will test you in a basic procedure rather than additional procedure. In one of the exams, they had asked about this cash flow forecast. This is the past exam question for 3 marks. Clear? Be careful there. Now, reporting requirements, sir. Very important. Extremely important. What we should report? First one, use of going concern basis is inappropriate as per auditor. Now, you tell me, GC is inappropriate as per auditor, but appropriate as per management now. So, management sees something else. I am seeing something else. So, if management says for us it is appropriate, boss, should I give my opinion or should I give your opinion? Huh? We should give our opinion. As far as I am concerned, for me it is inappropriate. So, therefore, I will give adverse opinion. But if management says, sir, wrong, sir, I am saying my opinion, pa. For me it is inappropriate because I have evidence. Whenever I am giving adverse opinion, that means I have evidence that misstatement is material. Okay. Now, if I give adverse opinion on this, then management should prepare financial statements on what basis? Liquidation basis. If management says, I will not prepare on liquidation basis, because for us it is appropriate, for you it is inappropriate. Okay. I will ask question to management. Will you prepare or not? If management says no, no problem, I will give adverse opinion. But if you prepare on liquidation basis, then you are a good boy. I will give you unmodified opinion with an EOM para where I will mention about alternative basis of accounting. Clear? Logic is very simple. Logic is very simple. Difference of opinion is there. Management is saying our assumption is good. You are saying our assumption is bad. No problem. You are having a right to your opinion. I am having a right to my opinion. So it means as per management, the going concern is appropriate. I will express adverse opinion provided you do not prepare on liquidation basis. But if you prepare on liquidation basis, I will first check that financial statements. Then I will give. If disclosure of basis is given, you are a good boy. You are telling the problems to people. Unmodified opinion will give you. And in EOM, I will put this particular fact that you have used liquidation basis of accounting and not going concern basis of accounting. Is this reporting requirements clear? Yes or no? Okay, sir. Next, let's say use of GC is good, but material uncertainty exists. Meaning, right now it is appropriate, but there is a huge uncertainty coming. What should management do? If it is a true and fair view, don't you think this I should tell to my users? Yes, sir. Now, material uncertainty is there. If you are telling to users in the financial statement, then you are a good boy. I will give you unmodified opinion, but I will include a separate section called material uncertainty with respect to going concern. I have already shown you the Vodafone Idea report where they have clearly told about going concern problems. Clear? Number one. Number two, if adequate disclosure is not made, there is a problem, but you have not told to the users. Good boy or bad boy? Bad boy. Therefore, I'll give you qualified or adverse because I have sign. Clear? As per SA 705. And in opinion section, I will mention what? Material uncertainty exists that may cast significant doubt on ability to continue as a going concern. Again, Vodafone report we had seen in our class. Okay. I repeat again. If going concern is appropriate, both are saying it is appropriate, but material uncertainty exists. If adequate disclosure is made, give unmodified opinion with a separate section called uncertainty. If adequate disclosure is not made, give qualified or adverse. And in the opinion section, this is important. Here you are giving a separate section. Here you are giving opinion section. So in opinion section, what you will tell? Uncertainty exists that may cause significant doubt on ability to continue as a going concern. What is the difference in this? What is the difference in this? One, I am dropping it in the opinion section only. One, I am dropping it in the separate section. Why? Because here you have already made a disclosure. Here you are not making a disclosure. Because of that, my opinion is changing. And in the opinion para only I tell you what is the problem. Clear? Third, management is not willing to make any assessment at all, or they are not willing to extend the assessment. Imagine assessment not made, or assessment made for less than 12 months. In these cases, this scenario will come. In this case, what will I do? I'll give qualified or disclaimer. Why? I am unable to obtain SAI. Unable to obtain SAI if it is there. Either you give qualified or you give disclaimer of opinion. Understood? Clear? Reporting requirements is extremely important. Be careful. Drafting, they may not ask you so much, but they may ask you with respect to reporting what opinion we should give. Only three scenarios are there. One, GC is, we have difference of opinion. GC is inappropriate as per me, appropriate as per you. Second scenario, both it is appropriate, but there is a uncertainty and disclosure is the problem here. Third one, you have never made the assessment at all. Clear? In third one, straight away I'll give either qualified or disclaimer. Clear? And more often than not, if going concern problem is a disclaimer is what we prefer to give. Got it? This is your essay 570 going concern. Let's talk about 580 written representation. Now, WR is a very easy standard to crack. WR is nothing but is a supporting evidence. Sir, what do you mean by supporting evidence? It is not a conclusive evidence. What do you mean by not a conclusive evidence? Conclusive evidence means where based on WR only I am giving an opinion. I will never do that. You know why? If WR was a conclusive evidence, no, we would never study audit so detailed. Go to management, ask them, did you prepare financial statements properly? Yes. Give it in writing, audit is over. We are not there for that. So therefore, it is not a conclusive evidence, it is a supporting evidence. Okay. Now, if WR is not there also will be okay. But if WR is there, it just supports the evidence better. What is my objective? I like my objective. WR objective is to obtain WR from the management. Second is to support other evidence. Third is to respond appropriately if you give, if you do not give. Okay. Now here, management means who? The one with appropriate responsibility. Now, who is the one with appropriate responsibility? Responsible for preparation and presentation of financial statements, which totally depends on what structure? Governance structure. Go and ask the management who is responsible for what. Generally, in annual report, they should mention it. Clear? Which they will mention in regular class. We had seen ITC report, we had read it exactly who is responsible for what. Clear? And there I think one of the person was responsible for internal auditor, etc. We had checked that. Clear? It is usually the management, but in some cases it is TCWG. You may request it from whom? CEO, CFO or other equivalent titles. In some cases, management may make enquiries of others and they are called experts. So whoever made that particular statement, from them we will take WR. Okay. Then date of period covered in WR. Date shall be as near as possible to the date of auditor's report. The date shall not be after the date of audit report. This is very common for us now. Clear? Meaning what? Once the report is signed, then we cannot take any extra evidences or can't put extra procedures. WR shall be for all periods or dates referred in the report. Now this is still fine. The main problem is the content of WR. What should be there in WR? In your ICA material, they have not segregated that. In my class, I have specifically segregated into primary WR, secondary WR, specific assertion, so that you get a clarity as to where these things come and fall into the picture. SA 580 is little scattered in the original one. So without this particular thing, you can still study, but this gives you a better clarity on it. Primary WR means what? Management has to give this with respect to what? Their responsibility. What are their responsibility? Providing relevant information. Number two, providing access as agreed in the engagement. Third one, telling that the transactions are recorded and reflected in the financial statements. And about communication of all SDICS. What is SDICS? Significant deficiencies in internal control system. About these four, management has to talk. What for? Number one, provided relevant information. Number two, access is given. Number three, transactions are recorded. And number four, about communication. But if I want, I can request the management to reconfirm their responsibilities. When? In four scenarios. Those who signed the WR, they are no longer responsible. Example, Karthik sir was in the management. I gave you the WR last year. This year, I am not there in the company. I quit the company. Therefore, your WR makes no sense. So, go and ask the new management to give new WR or renew the old one. The terms were prepared in the previous year. Current year terms are different. Therefore, WR will be different. Indication that management has misunderstood their responsibility. Ask the WR more. Changes in the circumstances, meaning business, more business, clear, different types of products, etc. Circumstances are different, therefore ask better, more WR or reconfirm their existing WR, clear. Now that is primary WR. Now comes secondary WR. Secondary WR is whose choice, sir? Auditor's choice. You don't believe the management, what can management do? You have trust issues, what can management do? If you determine that it is necessary to obtain more than one WR to support other AE or to support more than one assertion. Now, what do you mean by that? Try to understand here. Imagine there is a company and this company has made a credit sale to a debtor, okay, of 1 lakh. Now, how do you check the credit sale? You have checked the invoice, you have checked the stock register, you have checked the GST declaration, everything you have checked. Now you are happy with it, no? Still you will go and tell, sir, please give me WR. Now I am telling you, sir, why should I give you WR? Everything you have checked, no? Sir, but still for my sake you give, no, sir. Now I am giving you WR not because I have to give you, but you want it. Meaning, secondary WR is not the responsibility of management. It is not the responsibility. If they want, they can say, I will not give. Because all evidences I gave you, even after that you're telling, give it in writing. For example, imagine now, I am asking you, did you call this particular person? I told you to call that particular person. Now I am coming and asking you, did you call a particular person? And you said, yeah, I called. And I am telling you, sure. Now, you called or not, that's a second matter. First matter is, I am asking you to show. What does that mean? I have a doubt that you are not called. So, who has trust issues? I have trust issues on you. And why is that? Why do I have trust issues? Because you have done something like this in the past. Clear? So, it is my doubt which is giving rise to this secondary WR. That is why here if you see, if who determines and not law. If auditor determines it is necessary, then you can request such other WR. For what, sir? Selection and application of accounting policy. Now you can verify everything. It is given as a disclosure. Accounting is done properly. Everything is done properly. And still you are telling, I want WR for this. No problem. I can give. Then matters where you are recognizing, measuring, presenting and disclosing as per AFRF. You have done everything. As per AFRF only you have disclosed everything. Still I am not happy with it. What will I say? Give it to me in writing. Example. Your plans and intentions which affects the assets and liabilities. You have verified everything. Analu you are not satisfied. That's why you will take it in writing. Then liabilities. What type of liabilities? Actual liabilities as well as contingent. For that you can take it in writing. Sir, it is there in the notes to account. So, yes sir, but please give it in writing. title or control over the asset, invoice you saw, confirmation you took, still you are not happy, you will tell give it in writing. Should I give it? Should I give it? Is it mandatory for me to give? No, it's an option for me. But if I don't give, you will go and tell TCWG. Clear? No problem. I will give it. Aspects of law, contractual agreement affecting the financial statements. In these cases, if you want, you can request, but this is not responsibility of management. Therefore, they are not obligated. They are not obligated to give. But if they don't give, what you will do? You will go and talk to TCWG. Again, more drama in life. Clear? We will give, no problem. Pa. But management can be tired of your request. Clear? Because for everything, if you are asking WR, you do one thing, sir. You don't do audit only. Clear? Because every now and then, if you are checking for everything that I have done, invoice is there, government records, everything is there, still you're telling, give it to me in writing. Or I will tell, do one thing, what all you want in writing, you prepare and come. I will, like in Rajni, in Shivaji movie, you'll sign no, in two hands. You bring your WR and keep on signing. Clear? About specific assertion. Now, this is an interesting case. I am not talking about the entire transaction. I want WR with respect to a part of the transaction. Clear? Now, what do you mean by part of the transaction? I don't doubt that you have done credit sale. Clear? I believe you have done credit sale, but give me a WR on the amount of the credit sale. Just write and tell me about the amount, that this amount is correct. That means I don't believe your existence of credit sale. You have done the credit sale. Party is there, but just confirm the amount outstanding, valuation of the credit sale. Next, audit, you may request WR on specific assertion to support your understanding of management judgments, intentions or completeness. Example, sir. Now, before I give an example, this specific assertion WR is what we call as NAI. It is not SAI. What do you mean by that? It is necessary audit evidence, but not sufficient and appropriate. That means it is not conclusive. It is a supporting audit evidence. Example. Now here in the class example only I will take. There is a company, okay, who made a sale to one person for rupees 1 lakh. Okay, focus on the case and then give me an answer. This particular debtor name is Monica. Now, to Monica, we have sold 1 lakh worth of goods. This company has a policy that if anyone does not pay, or if it is not paid, if it is not paid within a month, we create a provision of 10%. Okay. Now, this is the case. The logic of this case, I want you to understand. Okay, sir. You are saying that provision is 10% we will be making for those debtors who have not paid for more than a month. Now, Monica's due is outstanding for 6 months now. How much provision you are supposed to make? Huh? I knew you would say 60,000. It is. We said if it is less than 1 month, if you pay, no provision. If it is not paid within a month, 10% provision. I never said 10% of every 10,000. Clear? Such silly errors will make in the exam and come and lose marks. Clear? And then audit becomes difficult. Okay. Now here, how much provision I am supposed to make? 10%, which means 10,000. Now imagine total debtors which is outstanding for more than 1 month is 6 lakhs. How much would be the provision? 60,000. But these did not make 60,000. They made only 50,000. They excluded Monica. Now the question is, you got to know this. You went and asked the management. What will you ask? Why did I create a provision for her? Now I will tell, sir, she is very consistent. She has given all dues in the last 3 years. Clear? She has never made a default in the last 3 years. So when I spoke to her, she said, in the next 20 days, she'll make the payment. That's why I didn't make any provision. Now, this is what management is telling you. What will be your answer?
Check the 3 years past.
Huh?
Check the past.
Now, we'll check the past 3 years record. But if you say, Okay, sir, no problem. That means management, they have taken a judgment. You have judged their judgment. Now, how do you believe them? Imagine now, last 3 years you have checked the records. That last 3 years records also will it give you a confidence that she will pay?
Not conclusive, sir.
That's what I'm telling you. Still not conclusive. You will be saying, last 3 years she has not paid, but a human being can change at any point of time. Clear? A friend will become X from nowhere. I mean, your friendship can break, is what I mean. Right? Human beings can change. You will be sharing a lot of secrets. Clear? Now, in that case, I can't trust that. No. Now, management says, sir, who can't trust that? You can't trust. Whose problem it is? Your problem. I trust Monica. She's saying she'll pay in 20 days, I'll trust her. Now, I will not create provision for her. Can you force the management to create provision? No. Now, what will you do? Now, you will tell, okay, pa. You trust Monica. You go and dance with her also, no problem. You give me in writing that you have conclusive evidence with respect to that. Okay, sir. Now, if they give it in writing, with respect to what? You never doubted that this debtor is not there. The existence of this debtor is there. I am not doubting that. I am not even doubting about the 1 lakh. Because invoice I saw, GST, returns I saw, everything I saw, I have declared it. I am only doubting with respect to this 10% provision. So give me WR only for 10% provision. Now this is specific assertion. What assertion I am targeting? I am targeting the valuation point of it. Technically, this was supposed to be 90,000. You record it as 10,000 only. Therefore, for valuation, give me one WR. I am not doubting the existence of the transaction. I am not doubting the cutoff assertion. These things I am not doubting. Only one assertion I am doubting is valuation. Give me specific WR for that particular valuation part. Understood? Yes, and that is what here we say provision for bad debts or doubtful debts, receivable which is due but no provision created. Now, when you are evaluating the judgment of the management, 4 things you have to consider. Does the management have history of such intention? Meaning, in the past, have you done something like this? Number 1. Number 2, why are you choosing this particular action? Reasons. Now, management told, because sir, she has never done any default. So, I don't have any reason to doubt her. Number 3, does the entity have ability to pursue this action? Meaning, they told within 20 days you will recover. Do you have the ability to recover? Now, I will ask management, after 20 days also, if she doesn't pay, what you will do, sir? Now, management is saying, that time I create provision, sir. Okay, sir. That means you have the ability to pursue the course of action. Then, existence of information obtained may be inconsistent with the management judgment, or lack of information may be inconsistent. Meaning what? You told last 3 years, Monica has not made any default. Now what I will do? I will check those last 3 years and I will tell management, give me the ledger copy. Now in the ledger copy, you said what? Last 3 years, she has not made any default. I found 2 defaults of Monica. Meaning, what you are telling and what information I have obtained, it is proving inconsistency. Should I trust you now? No, sir. Give it to me in writing. If I trust you, then probably I may not take it in writing. There is an inconsistency. Therefore, to save myself, I am taking it in writing. Understood? Clear? Right. Because whenever I write and give the trust increases. Clear? Generally only you will tell, no, I'll write and give, see, he will not come. Which means you are more confident about that particular assertion. So whenever you are writing and giving, the confidence enhances. That doesn't mean confidence is not there, but it's not very strong. Got it? Yes. This is your WR. Now there is one point which I want to discuss here. What if the requested WR is not given? With whom did you ask WR? Management. They did not give. Whose management's boss? Go and inform to TCWG. Generally, TCWG will solve this. If TCWG also is not solving, think of modifying your opinion. Understood? Okay, sir. This is with respect to... Now, you know why they are telling all these things? They don't know they are dealing with Indians. In foreign, no. written representation has a lot of value. Clear? Because there, if you write a document and give, you have to stay to that particular word. Their oral contract also works as a promise. In India, written contract only we will not do. And we're still talking about oral contract. So there, WR has a lot of importance. Here, even though I know that it is a lie, I will tell, I'll write and give you, sir. You want it in writing? No, you are a fraud. Clear? An auditor will tell, oh, I think if he is telling he'll write and give, I think he is telling the truth. Clear? But if auditor says, write and give, now the client will be like, sir, I chumma told I'll write and give. You took it very seriously. Clear? Now that is when they tell, sir, can we talk? Clear? So these things can happen. WR, because we are in line with Indian standards on audit, international standards on audit, same logic we apply. Papa, they think that what they apply internationally is applicable for Indians. Clear? That is SA 580. Now let's talk about SA 260. Communication with now in SA 260, what is the difference between 260 and 265?
Sir, regarding the disclaimer of opinion, if the auditor gets
Which standard?
Sir, I'll ask you.
580. Okay.
Sir, if the auditor requires secondary written evidence,
Okay.
if the management doesn't give, so he can't give a disclaimer of opinion.
No, he can't give disclaimer of opinion because we are not considering WR as conclusive evidence. Clear? Now, if you give disclaimer of opinion, it means that you have not obtained. How can you not obtain SAI? Management will tell, no, I have given you all the invoices and all. You are not trusting it. Clear? That's why here when we say in SA 580, it is nothing but a necessary evidence, a supporting evidence. It's not the only evidence. It just supports your assumption or judgment or whatever it is. So if WR is not given, I will modify, but not disclaimer. Because in disclaimer you are telling I have not obtained any SAI. Right? Now if you are telling, because before giving, you have to talk to TCWG. Yes. Now if TCW, you are going to TCWG and telling that I requested WR from the management, they are not giving. Clear? Now 99% of the time TCWG will give it. Clear? Now imagine TCWG says, sir, for this what written representation, sir? We have given everything now to you. Now you are telling that it is not enough for me. Now you tell me, if you are a TCWG, will you satisfy the CA or not? Yes. But imagine you are telling, no, we will not give it in writing. If you are arrogant, even we are arrogant. Now if you go and tell disclaimer of opinion, now I will have a reservations against you. Clear? Now I will go to your regulator and I'll tell, I am sorry, but this fellow is not good enough as an auditor. Now again inquiry will be there. Because of your disclaimer, my reputation is getting harmed. Yes, so I will go and talk to NFRA. Clear? Or I will file a case on you by telling he is giving inappropriate opinion. So obviously there, sir, I will tell the tribunal or the authorities that all the evidences I have given, but still he is not satisfied. What can I do? Now you explain it to NFRA or whoever it is as to why you gave disclaimer of opinion. Understood? But 99% of the time disclaimer you will not give.
Sir, but secondary opinion is request from the auditor.
Correct. That's why you will not give disclaimer of opinion.
So he can't modify.
He can modify. Because opinion is whose? Auditor's. Yes. So I believe that whatever evidence, WR if you are not giving, it talks about you, no. How can I trust you? That means whatever evidences you have given, I can't really trust it. Which means I have SAI that there could be material misstatements or there is material misstatement. I start evaluating about whatever you have told now. One lie you tell me, I start judging you for all the truths you have told. So even if it's a secondary WR, I can still give modified opinion, but definitely I cannot give disclaimer of opinion because practically disclaimer will destroy a company. And before giving, I have to talk to TCWG. So generally they will solve the issue there. Now you tell me, TCWG says, okay, management didn't give you, now I'll give you. Which is better for you? Sir, I will tell you give or management gives, for me, somebody should give WR. Clear? So no problem, they will give. And practically, it's not that they'll be fighting for these small things. If management has not done anything, is there a problem to be scared about? No. If management is not writing and giving, proves that something is wrong, don't you think you'll dig deeper into that particular transaction and check what is there? Therefore, you'll definitely have a SAI to give either qualified or adverse and definitely not disclaimer. But if I still consider, yes sir, I still did not obtain SAI and they are not giving WR for that also, then you can give disclaimer of opinion.
If it is primary.
Anything. For me, if I am not, because what is sufficient, what is appropriate, that also is my judgment only. Understood? Clear? But if primary WR is not given, straight away I'll have a problem. Clear? Because it is their responsibility, they have to give it. Secondary is my choice. SA 260. SA 260 talks about communication at TCWG. What is the difference between 260 and 265? 265 is about deficiency. 260 is about what? 260 is about complaint box. We are complaining about management to TCWG. Clear? For example, just now he asked a question. If management does not give, what to do? See here. I will be communicating to TCWG with respect to what? WR requested. So here I am complaining about the management. In SA 265, I am not complaining about the management. I am complaining about the systems to both TCWG as well as management. Whereas here, I am talking only to one person. TCWG. Clear? Right. Now, what is the significance of such communication, sir? It will help me in 4 things. What are the 4 things? Number 1, to understand the matters. Who should understand the matters? My matter, TCWG should understand. Their matter, I should understand. Clear? To develop a constructive working. So when I share the information to him, he shares the information to me, we can work our auditor and auditee relationship better. Obtaining relevant information for audit, meaning I will obtain information for audit from TCWG, he will get information from me. Because you tell me, is TCWG sitting and executing everything or only doing decision making there? So will he know what is happening at the root level? No. Whatever is happening in the root level, he will not understand. Therefore, I need to give him that particular insight as to what is happening there. Clear? Next. After this, overseeing financial reporting process. Now, what I mean by overseeing financial reporting process? Monitoring. Who should monitor that? TCWG. Meaning, imagine this year when I am auditing, whatever deficiencies I find or whatever mistakes I find, if I go and tell TCWG now only, it will be much easier for them to rectify it at the earliest. So next year audit will be easier for me. Clear? If I don't tell them only, how will they rectify? Okay. Then what is my objective? To communicate my responsibility, my scope and my timing. Why, sir? See, if I don't tell TCWG, management can tell wrong information about me. So what is better? Me only going and telling TCWG, see boss, this is my responsibility, this is my scope, this is my timing. Because tomorrow management should not come and tell you that I never said this. So I am telling you now only. Idda enoda vala. This is my responsibility, this is my scope, this is my timing. Then, my objective is to obtain information for audit. Clear? Providing timely, significant observation and promote two-way communication. Understood? Right, sir. That is with respect to objective. Next, matters to be communicated. What matters I should communicate? First one, responsibility. Second one, scope and timing. Third one, significant findings. Under significant findings, 3 things. Qualitative aspect, difficulties and management related point. Clear? So what is the first one? Responsibility. I should communicate my responsibility. What is my responsibility? Forming an opinion and expressing an opinion on what? Financial statement prepared by management, overseen by TCWG. Okay. Scope and timing. I should tell them my scope and timing also. What is my scope and timing? Overview of planned scope and timing and significant risks identified. Then third is significant findings. First one is with respect to qualitative aspect. I should talk to TCWG about how they have chosen, how is their accounting practice, how is their accounting policy, how is their accounting estimates and financial statement disclosure. Very simple logic, sir. What do you mean by accounting practice? Accounting policies and all I know. What do you mean by accounting practice? Accounting practice means you're telling, let us say the organization has a practice of everyday cash collection will be deposited in the next day 10 a.m. bank slot. Okay. Now I should communicate to TCWG whether that practice is good or bad. So I will go and tell, sir, today whatever you have collected, next day if you are going and depositing, that means the person who is handling the cash can actually embezzle today and come back and keep the money tomorrow before 10 a.m. No? Yes or no? Today whatever collection is there, tomorrow I am going and depositing. Yes. So today whatever collection is there, that money I can embezzle, use it for my purpose. By tonight I can come and keep it back. No. So I will tell TCWG, you can avoid that, sir. How you can avoid, sir? You imagine I'll tell ArivuPro, see sir, if you're opening branches now and if you allow them to collect cash of students will come and give cash. How sure are you that the cash will be safe there? So I will tell TCWG, this accounting practice is not good, sir. You do one thing. This is a business practice also. You do one thing. You change it to online. Now, TCWG is like, okay, sir, this is a good suggestion. I will take it. So they will change it to online. Now, accounting, in some of the cases, they'll be like, sir, we don't account every day. We account once in a week. I am like, sir, again, this is a problem. If an accountant is accounting once in a week, this fellow can manipulate the cash and all, no. Imagine every Saturday he accounts. Monday to Friday, whatever transactions are happening, I can manipulate and keep. And at the end of Saturday, I will keep it normal. Therefore, I should tell TCWG, this accounting practice is not good. Do one thing, everyday accounting you do. Now, TCWG is like, sir, everyday my accountant is part-time, sir. Sir, appoint full-timer, no. Sir, full-timer, again, we'll have to train, more cost. Do one thing, how much is your part-time charging? Sir, 10,000 per month. Okay, I have someone who can do accounting for 3,000 per month, give it to him. Who is it? Me only, sir. But me, not as me. Me as someone else. So, we have someone who will be taking care of accounting firm. Give it to him. I will train him. Now, accounting practices is good now. Because every day will be accounted for. Or if TCWG says, okay, sir, we'll appoint a full-timer accountant every now and then. Clear? And it will be integrated to the online books of accounts. So, from wherever I can check it, sir. So, I need to advise him. Here it is not about sitting and cribbing. Here more of matured conversation is happening with TCWG. Clear? Next, in any case accounting practice that is applicable under AFRF but not appropriate in the circumstances. This I told you long back with respect to inventory valuation of petrol bunks. Clear? For you, FIFO is applicable, weighted average both is applicable. But if you are following FIFO, doesn't make any sense. But if you're following weighted average, it is much more better. Now, FIFO is acceptable, but not appropriate in your situation. So, I'm telling you, don't follow that, sir. You follow weighted average method, much more easier for you to understand that. Similarly, for depreciation, I can tell. You need not follow SLM, follow machine hours method, or follow number of hours method. Use that methodology, I can also tell them. Next, significant difficulties. Now, this is purely complaint box. I am just complaining with respect to management to TCWG. Sir, management is not giving me information. Unreasonable brief time they are giving me to complete the audit. Sir, audit requires 1 month. They are telling me finish it in 3 days. What nonsense, sir. What is it? Auditor, cooking. I can't finish, sir. Clear? Unexpected efforts to obtain SAI. Sir, generally in 2 days information will be given. But this management is taking 30 days to give one information. I think you should interfere here, sir. Number 3. Number 4, unavailability of expected information. For example, sales invoice. It's an expected information. Management is like, invoice we don't have, sir. Loose tools, you are only generating the invoice, and what I mean invoice you don't have. Restrictions imposed by management, they are not letting me talk. Clear? External confirmation, management authorization is required, but they are not letting me talk, sir, very bad. Clear? Management unwillingness to assess the going concern assumption. Minimum how many months? 12 months. But I told management they have done only for 8 months, sir. Please interfere and ask management what is going on. Clear? These are the significant difficulties, important point, exam perspective. Yes.
So do we also communicate the restricting our scope of audit? Do we communicate further?
Before or after?
As in,
Before accepting or after accepting? After accepting, first we will request the management to remove the limitation. If they remove the limitation, our job is sorted. If they do not remove the limitation, then we will go and talk to TCWG.
and this is as per SA.
Yes, everything is communicating to TCWG as per SA 261. You go and tell them, hi, how are you? 260. Okay. Then, management related. What now? You tell me, if Karthik sir didn't teach you auditing well, whom will you go and tell? Now imagine I am the management in ArivuPro. I am the management in ArivuPro. To whom will you go and tell now? To me only. About whom? Who am I? Swami? Me, talking to me, through me. You are telling about my feedback to me only, telling Karthik sir is not teaching, look into it. What should I say? Fine, I'll look into it. I looked into it, I started teaching the same. Now tell me, did you have any use of that? No. If management is involved in TCWG and management and TCWG both are same, you are going and telling about management to management. Clear? It is like you are telling the thief only, somebody has stolen my money, sir, please find out and give. Will he give? No. Unless TCWG also is involved, if TCWG is separate, management is separate, then this makes sense. Otherwise, this communication makes no sense at all. Clear? Significant matters discussed with the management and W are requested. But if both are same, then there is no point in communicating to TCWG these two things. Then, circumstances that affect the form and content. This we have already discussed in SA 700, where I have told you if you are modifying the opinion or putting EOM or OM para, you have to first communicate to TCWG. Without that, you cannot include any of these opinion in the report. You need not communicate with management, but you have to communicate with TCWG. Clear? Right, sir. Any other matters, if you feel like telling, go and tell him. Okay? Right, sir. Now, in case of listed companies, or we read this, what you have to tell, you have to communicate compliance of ethical requirements regarding independence, including relationships between the firm and entity, and safeguards to eliminate the threats, where we have studied this in SA 700. In the report, you have to tell TCWG with respect to these things, that we have complied with ethical requirements and these are the relationships that were causing threats and these are the safeguards we are putting. Communication process, when you have to communicate on a timely basis. How you have to communicate in writing need not include all matters, only important matters. Sir, in audit 1 lakh matters I would have seen. Everything I should go and communicate about. No, only important matters. Communicate about independence, very, very important. You have to communicate. And you have to first evaluate whether two-way communication is adequate or not. Because the entire objective of communication is enhancement of the relationship here. Clear? And if that is not happening, then there is no point of communicating. Document two things. If you have communicated orally, when did you communicate and to whom did you communicate? If you have communicated in writing, retain a copy of it. But this doesn't make sense for me, oral. You know why? India. Clear? Imagine you have communicated to TCWG orally. You have to document when did you communicate and to whom did you communicate. TCWG will tell, to whom did you communicate? To me, I never saw you. No, sir, but I have maintained documentation. You can maintain, sir. I have never seen you. That is always. Now, and look at this. They have told if you have communicated, orally documented. But they are asking you to communicate in what? Moral of the story. You will end up communicating what? Writing. So, writing means even email is considered, sir? Or should it be a physical copy? Sir, writing, typing, everything is same here. Through email also is communication only. Clear? Letter, physical letter also is communication only, no problems at all. As long as you have communicated and there is an evidence of that, you are safe. Understood? Yes, that's your essay 260. Small standard, nothing great here. In this, focus on significant findings. In significant findings, focus on two aspects. One is qualitative aspect and one is significant difficulties. Okay, that is essay 260. Next is essay 265. What is essay 265? Communicating deficiencies in internal control system. Two basic questions which forms as a pillar for this standard. Question number 1, what is deficiency? Question number 2, do we need to report on all ICS? Okay. First question, what is deficiency? Sir, if a doctor tells you that you have vitamin B deficiency, what does it mean? What does it mean? You have or you don't have? You have less or you don't have at all? Both. Both are called as lack. Clear? You have but less is also lack. You don't have also is lack of deficiency only. So when we say deficiency, it means deficiency in ICS we are telling. That means ICS is there, not enough. That also is deficiency. Or ICS not being there also is deficiency only. For example, in this particular classroom, let us say CC camera. CC camera is there. It is not working. ICS is deficient. CC camera not there only. Definitely ICS is deficient. Clear? In both, now what is the logic of this, sir? Why are you calling both as deficiency? Lusus, tell me, if camera is there not working, it is of no use. Yes, people will do a lot of things here. Yes, we won't be able to identify that. I mean, you will not be studying, you will be playing games and other things. Okay, imagine camera is not there only. Full license. Clear? Right? You'll be sleeping on the desk and all. Right? Now, how do we curb that part? If camera is there not working, still fraud will happen. If camera is not there, fraud anyway will happen. Now, that is the reason why we call both are deficient. Clear? Not having ICS also is deficient. Control is not there, that also is deficient. Control is there, but it is not doing its job, that also is deficient only. But what are we going to talk to TCWG? Only deficiency or significant deficiency? Significant deficiency, which brings me to the question, what is significant deficiency? And this definition is important. What is significant deficiency, sir? Simple. Accumulation of deficiency which will lead to requiring attention of TCWG. What do you mean by that? Sir, it means accumulation of what? Deficiency. What is accumulation of deficiency? All small deficiency add together. Where now TCWG says, I think I should be interfering now. If that type of deficiency is there, then it is called as significant deficiency, or a single deficiency which will lead to requiring attention of TCWG. Both are called as significant deficiency. Meaning, now imagine CC camera is not working. TCWG will not be involved. But imagine in all classrooms CC camera is not working. Now TCWG will be involved because in the classroom something is going on which is not the right thing to do. Number 1. Number 2, sir, all CC cameras are not working properly. This camera is not working properly. Only one. Now TCWG will be involved because of this also classes are getting affected. So what is significant deficiency? In simple language to understand, significant deficiencies are those deficiencies which grabs the attention of TCWG. It could be as a single deficiency or accumulation, does not matter. As long as it is grabbing the attention of TCWG, that deficiency is called as significant deficiency. It also depends on the likelihood of the misstatement, meaning SD may exist even if I don't identify all misstatement. Meaning what, sir? I am not going to check 100%, no. I am only doing sample basis. So significant deficiency, even if I don't check, it will be there. My second question to you. First question we understood what is deficiency. My second question to you, do we check all ICS which is there in the organization? No. We will check only those ICS which are relevant to financial statements. Only if it is relevant to financial statements, we'll be checking. Otherwise, we will be least bothered about that. For example, ICS for non-operating department. Do we need to go and check? No. ICS for operating department, we will still not check. But ICS for financial reporting, we will check. Clear? So we will check only those ICS which will affect my financial statements or my audit. In those cases, I'll have to go and check it out. Okay. Now, communication of SD with TCWG. How I should communicate? On a timely basis. Should I communicate to management also? Yes. Like I said, in SA 265, I will communicate to both TCWG also. Why? What if management doesn't know about the deficiency, sir? Possibility is there? No. Employees will never tell management. Clear? Imagine here, this camera is not working. Management is there, but nobody told management. Management is innocent. Now, when I go and tell management, is it, sir? Like that, sir. Nobody told me. Like, yes, sir, it's not working. That's why classes are getting delayed. Oh, I'll rectify that, sir. So, management may not be aware. So, I will tell other deficiencies identified during the audit, but not communicated to them by their people. That time, management will be more aware. Number one. Number two, I want to tell to TCWG, before telling to TCWG, I am telling you, because you are the one who is executing this ICS, which is set by TCWG. So it's my duty to tell you first, then I will tell TCWG. So why am I telling you? I am telling you that I am going to tell TCWG now. So that tomorrow when they ask you questions, you should be aware. Okay. Otherwise, you will go and tell TCWG, no, why did they come and tell you, sir? If they had told me, I would have rectified it. That's why I'm telling you first, then I will tell TCWG. Meaning here, management knows. Whereas here, management does not know about it. Clear? And I feel it is important to inform TCWG. In both cases, I will tell management also, TCWG also. How I should communicate? In writing. Two things I should include: description and explanation of their effects. Enough information to understand the context. Sir, you have given the effect. Imagine I go to ArivuPro TCWG and I tell, sir, if something like this happens, no, it will be very difficult to conduct the classes. Okay, sir, what happened? Camera not working, sir. Okay, sir. Which classroom camera not working? Camera not working, sir. Which camera is not working? Camera not working, sir. Sir, we have 4 branches. I understand, sir. Coimbatore camera not working, sir. Sir, in Coimbatore, which classroom camera not working, sir? CC camera va, class camera va, phone camera va, iPad, which camera not working? Camera not working. Now, you have communicated, but are you giving them enough information to understand the context? No. Give me proper context to understand in what context you are talking. Clear? Now, I get doubt from recorded students at times. So, I tell students generally in the class, give me a context of your doubt. Now, when you are asking a doubt, no, give me a context. Because I know you will be watching the video. So, you are actually in the zone. So, when you type the doubt, you know what you are asking. I don't know what you are asking. No, because I will be seeing that doubt after classes or before classes. And imagine one student is asking, explain this. What? I will explain. No problem. Now, I had a doubt from one of the students. Sir, if you do this, that will happen. No. How is this possible? Now, what is this? What is that? And how is this and that? And when I saw on the, the path, the path is with respect to study material. Now, if it is a video, I can go to that video and check exactly where you are asking a doubt. Study material, you are asking this, that, this. So, I need to ask the student, please give me more context. Now, the student gives context in audit. Can I solve that doubt now? No. So, you have to give me more context. That's why, I think one of you, when I asked, I said, which standard you are asking about? You. Yeah, he asked about the WR. Right? Now, imagine suddenly if he says, sir, doubt. If management does not give, what? Which standard you are talking? Going concern, SA 260, SA 265. Randomly, if you are asking a doubt, no, I will be blank. Clear? So, imagine you go to TCWG, suddenly you are telling, I can't do this. What? That only. Because that is not working. What is not working? That only, man. Give me more context about it, no. They are not listing who they, management are, employees are, who are not listing. Give me more context so that I can solve it better. Understood? Explain specifically, very important in essay 265. Very important essay 265. Explain specifically four things. What is my purpose of telling it to you? Or what is my purpose of auditing? To express the opinion on FS. It's my only purpose. Number one. Number two. My purpose is not to express opinion on internal control system. I am not here to give opinion on ICS. Then TCWG will ask, then why did you test ICS? I tested only those which is relevant for my purpose, not for every ICS I have checked. Reported matters are limited only to those deficiencies which is identified during the audit. Meaning what? I should tell management that, or TCWG, my purpose is to express opinion on FS. So for that purpose, I had to check only relevant internal control system, and only that's the reason why I took only those ICS, and whatever I am reporting is only on those ICS that I have tested, which means there are many other ICS I have not tested. About those ICS I have no opinion. Only about these ICS I am telling you certain things. So clearly you have to draw that line between I am not here to do audit of ICS, I am here to do audit of financial statement. That line should be communicated very, very clearly. Otherwise tomorrow TCWG will tell you never told me that. Clear? So in the exam, please be careful. This explanation you have to specifically tell. If I was the examiner, I would have questioned you here, because all these things are very easy to understand. Clear? Now what is significant deficiency? There are certain indicators. RAP is missing. What does RAP means? I knew you would say risk assessment procedure. Same trap you are falling again and again. It is risk assessment process. Because internal control system is maintained by whom? Management. So the management should have risk assessment process. That is missing. Now they have RAP, but it is ineffective. They are not giving proper response. Misstatement is not identified, prevented and detected by your ICS. Clear? Management is not monitoring their financial statements. These all are indicators of significant deficiency. You have to go and communicate it to TCWG or directly go and tell the management as well. But if management only is involved, don't tell management, go and tell it to above level. Who is that? TCWG. Clear? That is it. In this thing, no, communication in process of communication is important, and what I am supposed to explain specifically is important. Right? That's your essay 265. Essay 450. Next essay talks about what? Evaluation of misstatements identified during the audit. Which means standard is very, very specific. Talks about what? Which misstatements? Unidentified or identified? Loose tools, unidentified. How will I go and talk? I only don't know. What will I go and tell? Only identified. What do I mean by misstatement?
The difference between the amount presented required.
Very good. It's a difference between 2 points. Difference between amount, classification, presentation, disclosure, reported, and amount, presentation, classification, disclosure, required. So basically what you have done, what you are supposed to do. If there's a difference, that is called misstatement. Clear? Now that misstatement I need to evaluate. So my objective is to just evaluate 2 things. What is the first thing? Effect of identified misstatements on the audit. What do you mean by that? How these misstatements will affect the audit. Number 2, effect of uncorrected misstatements on the financial statement. So first one here, I have not communicated to the management. I have just identified the misstatement. That is on one side. Another side, I have identified the misstatement. I have gone and reported it to them, but they have not corrected it, which gives me an attitude of negligence from management side. Both I have to evaluate. Okay. Only 2 things to evaluate. One is what? Identified misstatements, and one is what? Uncorrected. What is uncorrected? Identified, reported, but not corrected. Okay. To achieve the above, what am I supposed to do? Very simple. accumulate the misstatements first. Meaning, should I go and ask every small mistake to management? Imagine 1 rupee, 2 rupees difference and all you found. Go and ask her. No, don't ask once, one misstatement. Accumulate everything first. Clear? Then go and approach the management. Misstatement can arise from various factors. Which factors? These are factual misstatement, meaning what? Facts are wrong. Then we have judgmental misstatement. Assumptions that you have taken is wrong. And even in projected, the data could be wrong or even assumptions could be wrong. In judgment, even your data on which you have taken assumption also could be wrong. Example, factual misstatement is invoice value entered wrongly in the books of accounts. It's a factual misstatement. Judgmental misstatement is what? Every year you take 10% provision. This time also it is 10% only, but you took 15%. But the debtor is actually same. So you took a wrong judgment about it. It's again a misstatement. Going concern is a judgmental misstatement. Projected misstatements, meaning what? Futuristic assumption, you expect yourself to grow by 100% every year. Very wrong assumption you are having unless and until you have a potential. So is growing 100% wrong? No, not wrong. Growing 100% is definitely not wrong. But that growth assumption should be taken based on some data. Clear? If the data is right, assumptions will be correct. Understood? Right. Now that is what I am telling you. My humble and sincere request for all the students who are in the class, online live, YouTube, recorded, whenever you are watching this, do not just prepare your exams based on some prediction of some questions, 30 question, 50 question. You take it as an additional material. Do not solely go to the exam based on those questions. Clear? Do not go to exam saying, I will do only this 30 questions and go to the exam and clear. One more thing. Now, people who are watching this marathon, in the comment box, you will ask me one question. I will answer that now only. If I watch this marathon, will I get exemption? If you watch Bahubali, does that mean now tomorrow you can shoot Bahubali? No. You can enjoy that. This is a revision session. You can't get exemption just by watching a 20, 21, 24 hours of marathon. We take around 120 hours in a regular class. And you're expecting what we do in 120 hours, in 20% of the subject you can clear. And I can tell you that students have got 40 out of marathon. Clear? 40, 45, absolutely no problem if you're conceptually good. But if you're targeting for an exemption, no. You need to study at least of 2 rounds of proper studies and then watch the marathon. Then it is a cherry on top of the cake. Cherry on top of the cake. Cake must be there. Clear? Marathon is a cherry. Okay, it's just a revision purpose. Watching this, you will not get exemption. I will tell openly on camera, watching the marathon, you will not get exemption, but it will help you immensely in revision for sure, because in regular class we'll be seeing the many questions, we'll be seeing reports, we'll see that this so many documents outside the syllabus. We go and check and then get the conceptual clarity, and that's why in the marathon you are able to at least respond to the questions. So disclaimer, this marathon, just by watching this marathon, going and writing exam will definitely not give you exemption. Clear? But passing, yes, there is a possibility that I can tell. Okay. So now when I take this judgment, no, this particular projection that you're having, I'll watch marathon, go and score exemption. Not possible. It's a misstatement. What a misstatement it is? Projected misstatement. Clear? So your assumptions about future data is absolutely wrong. You're telling that government will never do anything to me, sir. Who are you? Government doesn't even know that government will come next election or not. So whatever you're projecting, your future growth, sales perspective, budgets and all, when you're putting wrong assumptions, if you're having, that also is a misstatement only. Okay. Now, as the audit progresses, what I should do? Consider the identified misstatements first. Now, I already told you, when we start the audit, do we doubt the client and start the audit? No. So we always think that client is good and we continue the audit. Going forward in the audit only, we find some misstatement. Now, as and when we go ahead, the misstatement keeps on increasing slowly. Bakku sir, because my materiality limit is closer. Yes. So, don't you think my strategy and plan should change? Yes. So, if the misstatement is slowly increasing, consider whether strategy and plan requires revision. And that is what we saw. Planning is a continuous process and it should be flexible. It cannot be rigid. Number two, under this, consider nature and situation that indicates undetected misstatements could be material. Accumulated misstatements approaches materiality level. Imagine I put up a strategy and plan. Now I'll take students only. Classic example. We'll take students. Students, when they come to intermediate, they take an assumption that both groups will write. Okay, you took the assumption. Decision taken. Correct? Started one subject slowly. Okay? And nice. New intermediate class. Friendship will be done. Group of friends will be there. After class hours, movie. After class hours, cricket. After class hours, enjoyment, entertainment. Everything will be there. Okay? Now, you think that this is how the course will be going forward, new subjects will be introduced slowly. You know how the boiling point will come for the water? Yes. Now nothing. You can still put the finger when the water vessel is in the gas. After 10-15 minutes you try, you won't. Now what will happen is, whenever your accumulation of syllabus happens, slowly pressure increases. When the slow pressure is increasing, now you will start, I think I should change my strategy and plan. Clear? Now your strategy shifts, your plan shifts. Why? You thought these many days were enough for you. Now it is approaching that particular day and you have not finished your portion. So you tend to change your plan. Some people tend to change from both groups to one group. Some tend to change from both groups to no group. Some tend to change that don't want CA at all. Clear? Changes have happened. Right? My friend has quit CA because he is not able to rate both groups. That is extreme change. Clear? There are other friends who have shifted to different attempts. That also is change only. All changes happen because when you planned, you had a different idea. When you are doing the audit, you have a different idea. Clear? Request management to examine the relevant ABCD. Imagine entire sales I audited. Right? Now my overall full materiality limit is 10 lakhs. When I audited the sales only, no, I got 6 lakh rupees misstatement. Now I will tell management, yo, day, what management you are? Sales only 6 lakh rupee difference I am having in my sample. Out of 1000 invoices, I took only 100. In that first 10 invoices is giving me 6 lakh rupees difference. I will tell the management, Ayya, go to your department, check the entire sales and see what actually is wrong there. Because if I continue like this, no, it will breach my materiality limit and I can't continue. Request management to examine the relevant ABCD. What is ABCD? Account balance, balance sheet items, asset, liabilities, etc. C, class of transaction, P&L items, income, expense, etc. D, disclosure, notes to accounts and other disclosure. Ask management, see, I can't do the audit, go and check the entire system. What is wrong and how many misstatements are actually there? Because I got only 6 lakh now in 10 invoices. I don't know how many misstatements are there. Go and check. Get to know the reality basically. Okay. And ask them to understand the cause. Number one. Imagine they went, they checked, they came and they're like, sir, what you said was right, sir. The entire ledger is wrong. I'm like, how come? Accountant gave you previous year ledger, sir, instead of giving you current year. Like, very good. Imagine I would have given opinion on that. Right? Now I should be blamed for that because I did not see the ledger. But what is the ledger? They are written financially 24-25, but the data imported was 23-24. It has happened. Because from one system to Excel you export. When you change the date, now imagine you change the year, but you forgot to change the data. Clear? So I should tell the management, please go and find the actual reason why there is a difference, understand the cause, perform procedures to know the actual misstatement, total misstatement in reality. I should go and ask them to check the reality and then make appropriate adjustments to the financial statements. Now, if I had not found the misstatement, they would have never been able to rectify the misstatement. Clear? If management has corrected the misstatement, should I blindly believe them? No. Perform the procedure to check whether the misstatement still exists or not. Example, simple example to understand this. Imagine I went to Ananda's. I ordered veg biryani. Sorry, palau I ordered. Okay. I got the palau there. I had couple of spoons and I found something is wrong there. Now, obviously I tasted a misstatement out of the sample. Yes. Now when I tasted, what should I do now? Should I stop eating and tell the server or continue eating? Stop eating because obviously misstatement, my materiality limit health. So I will call the server and I tell, boss, see, something is wrong in this, go and check. Now, if veg pulav is wrong something with me, that means that would have been picked from somewhere now. Yes or no? I will get only one bowl. Now, the content of that bowl came from some source. There could be the source only could be wrong. Can I enter into the kitchen? It's not my responsibility. Yes. Therefore, I will tell the server something is wrong. Go and check. Now, manager will go and check whatever is wrong and he will come and give me a different bowl. Sir, take sir. Now, should I blindly believe him? The new bowl also what he gives, should I blindly believe him? No. Again, I will eat a couple of spoons and I will test. And I am not talking about food and Anandas here. Anandas is my client. Imagine the source is the financial books of accounts. The bowl is financial statement and the 2 spoons is the misstatement and the manager is my client. So when I tell him, see boss, I found misstatement. Go and check what is wrong. Clear? And he will go check what is wrong and then give me revise the financial statement. Should I blindly believe that? No, still check whether those misstatements are there or not. If it is there, withdraw your engagement or you can modify your opinion. If it is not there, continue your audit. Is that understood? Clear? Okay, sir. Communication and correction of misstatements. Communicate on timely basis unless it is prohibited by law or regulation. Request management to correct those misstatements. Enables, see, when I tell this, it will help management also to identify where what is wrong. Because always management cannot be wrong. People working for management can be wrong, but management can be good, no? Yes. So when I tell management, they'll understand what is wrong in their organization. If management refuses to correct, you arrogant little boy, you are a very bad boy. Therefore, understand the reason why are you not correcting it. Clear? And even after that, if you are not correcting, I will modify the opinion. But if management says, sir, I am not correcting because it is not necessary, sir. It's immaterial. Now, if it is immaterial, they are telling, and I should take it in writing. Give it to me in writing that it is immaterial. Clear? Then evaluate whether financial statement is free from material misstatement as a whole. Now, effect of uncorrected misstatement. Check the materiality limit and check if uncorrected misstatements are material after considering 2 things. What is that? Size, nature, circumstance of occurrence. 1 rupee misstatement correct, immaterial only. But 1 rupee stolen now becomes material because not about the size of the amount, it because of the circumstances of the occurrence. So consider all, size also, nature also, circumstance. Then effect of uncorrected misstatement with respect to prior periods, meaning last year also audit would have been done. Last year also CA would have told you certain misstatements. Did you correct them? If you corrected, good. If you have not corrected, I will ask why. And if management says those are all small misstatements and nothing will happen, then give it to me in writing that nothing will happen. I will believe. Clear? Communication with the TCWG. 3 things you have to communicate. Uncorrected misstatements and their effect on the which opinion? Whose opinion? Sir, I have told to management. They told they are not going to correct it. Because of that, I am going to give qualified adverse or disclaimer, sir. Your call. Now, that I have to communicate. Second, identify material uncorrected misstatements and ask them to correct it. And I'll tell TCWG, I told management, they are not listening to me. Now I'm telling you, please correct it. What if they don't correct it even after that? Modify the opinion. Third, Effect of uncorrected misstatement with respect to, sir, why is it repeating? Sir, here I am talking to management and management said it is immaterial. Okay, same thing I will go to TCWG and tell, see, they are telling immaterial, is it true? And if TCWG says it's immaterial, then come to the next point, obtain written representation about their belief that it is immaterial and attach a summary of such item to WR, because I have found all the misstatement, attach it to WR and ask them to sign on both. That way, I will have an evidence that I have told them they have considered it as immaterial. Tomorrow, they should not blame me for that. Clear? And at the end of the day, document all misstatements accumulated and corrected. Whatever conclusion you have got on materiality of uncorrected misstatement. For them, it is immaterial. Document for you, it is material or not. That way, when I read the file, I get to know these are the misstatements you have notified to them. These are immaterial misstatements for them, and these are material misstatements for you. Because follow my question now. To give a modified opinion, two factors are required. Materiality of a misstatement, pervasiveness. Here we are not talking about pervasiveness. Here we are talking about materiality of misstatement. So what is material for me can be immaterial for management. So they told immaterial, for me it is material, therefore I give modified opinion. Under modified opinion, tomorrow when inspection comes, I will ask CA, how do you know it is immaterial or material? Sir, I have a documentation. See, these are the misstatements which management told immaterial. These are the misstatements I told it is material, and they have signed it is immaterial. So for me it is material, that's why I give modified opinion. I'll be able to prove it on the face of it. That's why documentation is important. Got it? Understood? Yes. This standard is very easy with respect to communication. What are we communicating? All the misstatements identified in my audit. That means even if I have not audited 100%, whatever I have audited, in that whatever misstatements I have found out, I will be telling, number one. Number two, after that management has to take care. If management corrects everything, audit them and go forward. If they don't correct it, ask them why are they not correcting it. If it is immaterial, go to TCWG and tell, see, management is saying so and so, is it true? If they are also saying, TCWG also saying is immaterial, no problem, give it to me in writing and I will maintain a documentation of it. Clear? Yes, this is your essay 450. With this, our chapter number 7 also is done. Clear? So we'll take a break, lunch break, and we will be starting with chapter number 4, Audit Evidence, the heavyweight champion of the syllabus. Clear? Let's begin. Chapter number 4, Audit Evidence. Essay 500 series, one of the most important topic in your CA Intermediate Audit syllabus, which forms as a base for your CA finals as well. Essay 500 talks about audit evidence. Here 8 standards are there to discuss: 500, 501, 505, 510, 520, 530, then 610 also, and 550. These are the standards that we are going to cover in this particular chapter. Essay 500 talks about audit evidence. Now, without evidence, like I said, we cannot give any opinion. If this particular standard was not there, you will end up giving only disclaimer of opinion, because without evidence you cannot give unmodified opinion, you cannot give even adverse opinion. So evidence forms is nothing but a supporting part. It plays a supporting role, very important role in giving an opinion, because without evidence we have to evaluate the evidence and reach a conclusion, and we have to evaluate the conclusion and give the opinion. So without this, the conclusion cannot be formed. So when will we give conclusion? Only after obtaining reasonable assurance, and reasonable assurance is our main objective of essay 200. AE, that is audit evidence, is cumulative in nature. Cumulative means what? It is, we cannot say based on one document only that this is what the company is all about. Like if, for example, in the court of law, we cannot just submit one evidence and get the judgment. You have to give multiple evidences. Same logic here. Opinion cannot be formed just based on one or two documents. We'll have to give multiple documents. So AE is cumulative in nature. It means it is not conclusive at one instance, meaning just by one explanation, one document, one evidence, we cannot conclude. So we require many evidences. Example, sir. Can you give us example for this, sir? Yes. In case of sales, let's continue with the same example of sales. For a sales, what is called as conclusive evidence? Just invoice is good enough for you. Is invoice going to give you the conclusive evidence? No. We require GST returns as well. But is GST enough, sir? No, because sales also is created by the entity. GST also they can file a return. Now, we need to also check inventory records. We need to also take external confirmation. We need to also check bank payments or payment trail. Now, all this put together when you evaluate and then you are telling that sales is good. So, it is not just with respect to one invoice or one returns. We require cumulative feature here. Then, it is primarily obtained from performing procedures. Primary source of MCQ, primary source of audit evidence is nothing but procedures. Clear? Only when we perform audit procedures, we get audit evidence. So that's our first source of evidence. In the course of performance, information can be obtained from other sources as well. Like for example, whenever we talk about evidence, generally management record also is an evidence, contracts, signatures, vouchers, all these things are evidences only. But primary source is always and always and always auditors procedures. Okay, what are the two sources? One is called audit procedure source and one is called other sources. Under other sources, we have previous audits we can take. Entities records are also there. Management's expert work. Now, management expert work is not there in your syllabus. Okay. Only one topic of management expert is there in the syllabus. That is, if information is given from the management side produced by the entity, there are two things. One is expert's opinion or expert's work and one is management's work itself. Okay. Now, evidence is both that supports the assertion and does not support the assertion. Now, what do you mean by this, sir? Supporting the assertion means that which corroborates or satisfies our whatever is the information. For example, in the sales ledger, if there is an amount, invoice is supporting the assertion. Now, what do you mean by does not support the assertion? Imagine you have put in balance sheet, you have put a asset called as, let's say, for example, land and building 10 crores. Now, for land and building, there is no agreement at all. There is no payment proof at all. Now, you have put one transaction in the balance sheet, but where is the evidence for that? So, not having an evidence also is an evidence. Just like how they say silence is a language, clear? Not having evidence also is an evidence. Having evidence is anyway having an evidence. So, that which supports the assertion also is an evidence. That which does not support the assertion also is an evidence. Main topic of evidence is nothing but sufficiency and appropriateness. Now, that is how we talk about SAI. Remember, in an organization or in a client, we will definitely get evidence. So, evidence is not the point. From evidence, we have to filter. Okay? It is like this. It is like this. Just imagine this particular funnel. Now, this particular funnel, if you see, let us say from, how do I turn it? Forget about it. Sure. Now, imagine you put information here. Client will give information into this funnel. He will give everything that is possible, but we do not want everything that is there. So, we'll filter it, and from the information what he'll put, we will take evidence. We will further filter this evidence, and only what is required for audit we will take. So, from evidence we filter it as audit evidence, and we further filter it, and here is what we get as sufficient appropriate audit evidence, which starts technically from whatever information the client only is giving. So, not all evidence is important for us. Out of that, we have to filter, and then we'll get sufficient appropriate audit evidence. Now, what do you mean by sufficiency here? It's a matter of quantity, meaning how many documents do we have? Quantity, we can measure it. If risk is more, we need to take more evidence. For example, sir, if there is, let's say, for example, a patient goes to a doctor, and if the patient is not really keeping well, the doctor orders a scan. But if he sees that I think there is a little higher risk in this particular patient, he will not stop with one scan. He will take multiple scans. He requires multiple evidences. Clear? Which cause risk is high. Higher the risk, higher the evidence. They are directly proportional to each other. So if risk is automatically increasing, I need to increase my procedures. Therefore, evidence will increase. What are the factors that are affecting the quantity? Meaning how much evidence I require or how many evidences I require, that depends on three factors. Materiality factor, Mrs. is very important for us in evidence, right? Now, M for what? Materiality, meaning anything that is important, automatically I should take more and more evidence. Now, if there is an important topic in the exam, you study once or you study multiple times? You study multiple times. That which is not important, you don't study at all. Clear? Now, that is called materiality limit. ROMM, risk, automatically. If risk is high, automatically my procedure will be increasing, evidence will be increasing, because ROMM is whose part? Management's part, because they have done more mistakes. I need to check more and get more evidence. Size and characteristics of population. If the population is homogeneous, I will take lesser evidence. Why? Because the units are similar. If the population is heterogeneous, I will take more evidence because there are varieties of units. But generally, we will sort the heterogeneous population into homogeneous population for efficiency purposes. Clear? Now imagine a particular population is given, sales is there, purchase is there, everything is there. We will not sit and audit like that. What we will do? From that we'll segregate sales, we'll segregate purchase, and then we will be doing. Like when we go for a bank audit, the bankers will give us the entire loan portfolio, take, die. Now in that loan portfolio, we will not sit and do whatever he wants us to do. We will ask in the Excel, what we will do? We will first sort out how many housing loans are there, create a separate sheet for that, then vehicle loan separate sheet for that, then personal loan separate sheet for that, agriculture loan separate sheet for that. So we'll convert a heterogeneous population into homogeneous population. What about appropriateness, sir? It talks about quality, not about quantity. It talks about quality. Now, can you explain quality? You cannot measure quality, but you can only explain the quality. For example, imagine, let's say, there is a particular brand, all right. Now, whether that brand ka product is good or not, can I measure and tell? We cannot really measure and tell. If I say, let's say your mom cooks really well. Now, can you please measure the quality of that and tell? You can't tell. My mom cooks 1 kilo super, sir. There is no such terms at all. But you have to explain it. Sir, the way my mom cooks, this is perfectly cooked. Not more, not less. Salt, exactly this. Spiciness, exactly this. So you have to explain the quality. There is no measurement of quality. Therefore, it is influenced by only three things: source, nature, and circumstances. Sir, if Karthik sir tells you that tomorrow is the result, you will not believe, because even though there is sufficiency, there is no appropriateness. If 100 lies you tell, a lie is a lie. Sufficiency is there, appropriateness is not there. But one truth, sufficiency also is there, appropriateness also is there. 100 notifications can come, but until and unless ICS notification come, you will never believe anything. So appropriateness is totally dependent on the source. Who is telling us? Nature. What type of information? You tell me. Oral information is better for you or written information is better for you? You always trust the written information. Circumstances. Coerced information is better or free consent is better? Free consent is better. Forced consent here is of no use. You give an affidavit also, even if you sign and give it, if you are threatening it, then absolutely no problem, sir. I will not trust that, because even though the source is good, the circumstances are not great. Therefore, even in Indian Contract Act, this is called as void. If you do not get the consent, undue influence, misrepresentation, fraud, coercion, absolutely we will not consider that. If ICS is stronger, whatever information you have produced will be complete, accurate, and therefore for me it is reliable. So if ICS must be very strong for that. For example, if your parents trust you for what you are telling, that means they know that you are telling the truth. But if you have lied before, your parents will never trust you after that, because your ICS is not stronger. If your ICS is stronger, totally no problem. The system, whatever information is giving, will be true and accurate. What is my primary source? Like I said, procedures. What type of procedures we have? Risk assessment procedure and further audit procedure. In risk assessment procedure, number one is, what is that? Procedures performed to obtain understanding about three things: entity, environment, and internal control. So unless I understand the risk, I cannot put up the further procedure. I need to see how much risk is there. If risk is more, automatically further procedures will increase. If the risk is less, further procedure will decrease. Done. Why are we doing RAP? To identify and evaluate risk of material misstatement. This could be due to fraud or error. Now, who should do this ROMM? Management should do ROMM. So it's their responsibility. They could have done fraud, they could have done error. To identify which one of it is why we do risk assessment procedure. So why we do RAP? To do two things: identify and evaluate whether it is due to fraud or error. Now answer: if it is fraud, further procedure will increase. If it is error, further procedure will decrease. I am not saying we will not do at all. Number one. Number two, can risk be eliminated? Not possible. Risk can never ever be eliminated. It can be only reduced to acceptably low level. Clear? Rarely you will see risk being eliminated. There is one way to eliminate the risk: by not accepting the client. Clear? That's the only way to eliminate the risk. But if you accepted the client, there is no way you can eliminate the risk of client lying. How can you eliminate that? Not possible at all. Clear? What is further procedures? Further procedure are of two types. One is called test of controls and one is called substantive procedures. Now, MCQ they can ask, what is the other name for test of controls? We call it as compliance procedures. We call it as compliance procedures. See, other name of TOC is nothing but compliance procedures. Then we have substantive procedures. What do you mean by compliance procedures, sir? Checking whether the system is working as per the instructions or not. Clear? That's called compliance procedures. Now, when should we test controls, nature and extent? Why are we doing TOC, sir? To obtain effectiveness and to check the dependency on other control. Now. TOC we will be doing. Focus on the chart. TOC we will be doing based on what? Based on our understanding of internal control, we end up testing the control. Here we understand whether ICS is good or ICS is bad. If ICS is bad, we still go and do TOC to check how bad it is. If ICS is good, we go and check. Again, we will go and anyway check because you told good. No, I should know how good it is. That means in both cases, I will end up checking test of controls, but it is totally based on what? Understanding of ICS. If I have a good understanding of ICS, I may decide to rely on ICS. If I decide to rely on ICS, what will happen, sir? My job of further procedures will automatically come down. Clear? Because if I understand this particular system can save my time, I will definitely rely on that particular system. Clear? Now, test of details and analytical procedures are there under substantive procedures. What do you mean by test of details? Getting more detailed evidence of transactions and events. Example. Checking the process of purchase. Checking the process of purchase. I'll give you an example, and with that, this concept will be done for us. What is the process of purchase? Whenever we want to purchase anything, what is the process in organizations? First, purchase order must be placed. But before purchase order be placed, first of all, we should see whether production department wants so much or not. So, who should give me the input? Production department. For production department, who will give input? That is called test of details. Get into the details more. For production department, input is given by the sales department. Why? Only if there is a demand I will produce. No. If demand only is not there, what will I produce? Therefore, the sales department will tell me how much exactly they are going to sell and how much is the demand outside in the market. They will tell this is what the requirement of the market is. Now, production department will tell we don't have that many units. We need raw materials. So, production department will tell purchase department, sir, we want this order. What will purchase department do? Check whether whatever production has told is right or not, appropriate or not. Then what they will do? They will select the right vendor in the market. But how do we select the right vendor? By calling tenders. Clear? Come and apply. Give a quotation. So out of that, we will select the best out of it and then we will give our order to them. Once we give our order to them, they will send the goods to us. When they send the goods to us, we will be receiving the goods. So when we place order, we generate a document called purchase order. When they send the goods and we receive, we generate a note called goods received note. Check that. Once we check that, then our inward register must have an entry in the organization that these goods were received on these dates. Now that will come to the purchase department. From purchase department, it will go to inventory department. Clear? Because purchase, if they have a cross checking to do, they'll do a cross checking and send it to the inventory department. From inventory, it will go to production department, convert this into finished goods and go to the sales department and make the sales, and this will be accounted for. Now this is the entire cycle of purchase. Clear? But the purchase cycle doesn't end the moment you account for it. Purchase cycle ends once you make payment to the creditor. So starts with placing the order, ends with paying the creditor. That's when the purchase cycle ends. And if I want to know, that is called test of details. Similarly, sales cycle. When does sales cycle get over? We should ask the management, when does your cycle start and when does it end? Clear? Starts from maybe customer placing an order, right? We going now, for example, in Swiggy, how does your sales cycle start? Instamart, how does the sales cycle start? Customer will select the location, customer will place the order, and the order through app, it is received through the nearest store. Now the nearest store should accept the order, assign it to the driver or whoever is the pickup delivery guy. He will come, pick it up, go to the location, give it, deliver it, and if it is cash on delivery or whatever, the moment payment is collected, that is when cycle is completed. And in case of prepaid orders, the moment it is delivered and accepted, the cycle is completed. Amazon has a check and accept mode. Once any goods have come, you have to open in front of the delivery guy, check whether the goods are in order or not, then you accept. That time it is when sales cycle is done. And this is what we have to understand from management. What is the entire procedure? Walkthrough test is what we call. We can get into the details, and that type of is what we call as test of details. In your syllabus, this entire concept is called as chapter 5. Items of financial statements, which is a very big chapter. Clear? Then comes analytical procedures, which is under section, which is under SA 520. Okay, right. Next. Now, what is the procedure that we can put, sir? REO AE procedure is there. What is REO AE? R square, recalculation and reperformance. What is recalculation? Checking arithmetical accuracy. Reperformance means what? Performing whatever management has performed. Same procedure I am going to perform and check how effective the systems are. I square, inspection and enquiry. What is inspection? Documentation, checking the documents. Also, physical verification comes under inspection. Remember, physical verification comes under inspection. MCQ they can ask. Inspection is not just documentation, it is also physical verification. Then we have inquiry. What do you mean by inquiry? Asking questions or seeking information from knowledgeable person. From knowledgeable person. What is observation then? Checking or looking at a process. Now inventory count is happening. We staying there and standing there and seeing the process is what we call as observation. Then AE, analytical procedure, and external confirmation. Both have a separate standard. AP comes under SA 520, external confirmation comes under SA 505. Okay. Now whether evaluation of evidence, whether it is sufficient or not, is a matter of professional judgment. That is why you take a call how much evidence is good enough for you. Yeah, you can take 10 evidence, you can take 15, you can take 20. It is totally up to you. You decide how much is sufficient and appropriate. Now, relevance and reliability. Evidence should be sufficient also, appropriate anyway we have seen. It should be relevant also, reliable also. What do you mean by relevant? Last year information may not be relevant for me this year. Clear? Example, you are writing in Jan. Imagine I give you 15 ultimate important questions for Jan 26, but I give it in the month of March 26. Is it important for Jan 26 now? No, sir. Is it important for May 26 now? Again, there is no point in that. Therefore, we need to understand one thing. Information must be relevant. Like that only, evidence must be relevant. Last year's bank confirmation certificate is not important for me in the current year audit. So it deals with logical connection. Logically you think last year how was it relevant for us? Provide AE with respect to only certain assertions but not all assertions. For example, if I give you, I have purchased one bullet bike. I'll give you an invoice. Is that invoice good enough to tell you the title of the vehicle? Or do you want RC book? Now invoice doesn't tell the title, right? I want RC book to give me a better evidence there. Clear? Payment. In the books of account, I might have entered 2 lakh rupees, but the invoice shows 1,50,000 rupees. Now that means that invoice doesn't give me complete evidence with respect to the valuation, because the extra 50,000 that I have spent could be on accessories. For that, separate bills might have been generated. Obtaining AE for specific assertion is not a substitute for other assertion. Sir, what do you mean by that? Let us say a bike. If I purchase a bike, in the balance sheet, we will write under asset side, we'll write bike of, let's say, 2 lakh. Now, this bike, we need to check the title, we need to check the amount, we need to check the cutoff, right? And we need to check the rights. Now, for a title, invoice is not good enough. Now, invoice is there. The invoice will not give me evidence for title completely. It will not give me evidence for amount completely, but it will give me evidence for cutoff. When was it purchased? That is a conclusive evidence for me to tell whether I should include in the current year balance sheet or next year balance sheet. So, invoice can give you substitute assertion evidence for cutoff assertion, but not for title, amount and rights. For title, amount, I should take some other evidence. Clear? Invoice could be playing a half role here. But if accessories are purchased, now generally what we do is we take vehicle from showroom. But accessories we might be going to some other roadside shop, some other area where we know our friend shop is there. There we might be including all these accessories. There that bill also is required for us. So obtaining AE for specific assertion is not a substitute for other assertion. Invoice can be giving you a cutoff one, but it cannot give you for rights, which means logically for different assertions I need to obtain different evidence. That is what we call as cumulative evidence now. Okay. Reliability depends on 3 things like we already said: source, nature and circumstances. Answer this. Dependent source is better or independent source is better? Independent source is better. Internal is better or external is better? If ICS is good, internal. If ICS is bad, external. Original is better or photocopy is better? Oral is better or in writing is better? Now these are all the points of our reliability point which can be asked in the exam. Clear? Document and oral, which is better? Documentation is better. Original or photocopy? Original. Direct or indirect? Direct is always better. Clear? Then selecting items for testing, past examination area. Here they have asked. There are 3 ways to select the items. One is called 100% selection, one is called specific selection, and one is called sampling. Sampling is straight away going to essay 530 here will not be dealing with. Now, 100% selection correct, not appropriate in case of TOC. Why? First of all, do we go and check all TOC? No. So when we are not checking the entire TOC, what is the point of talking about 100% test of controls? Okay. Then common in case of test of details. It is very common because if let's say for example purchases, checking all purchases is common, no problem for us. Checking all rent transactions are common. Checking all income is also common. Now, question where they will ask is here. In which situation 100% checking is appropriate? In 3 scenarios, 100% checking is appropriate. Number 1, population has small number of large value items. What does large value means? Number of items are small, but every item value is more. Example, diamonds, platinum and very rare gems and stones and jewelries. You will have very less quantity, but the value can be pretty high. Significant risk and no other means of obtaining SAI. See, for example, let us say audit for you. In group 2, one of the easiest subject now. Now my question to you, as a student in the exam perspective, when I ask you a question, in group 2, which is the most irritating subject? Now, if you are smiling and not telling to me, it means it is audit. Clear? Otherwise, you would have straight away told some other subject. That means some other subject you are comfortable with if you are not naming them. If you are not naming audit in front of me and chumma if you are smiling, that means I also know the answer. But my question to you, you like or hate, can you skip it? Do you have any other option of becoming a CA finalist? No. Do you have any other option of becoming a CA without writing audit paper? Absolutely not. So whether you like me or hate me, you have to suffer me, is what the subject is. Clear? That is what they're telling. No other option, sir. No other option. I have left with only 100% checking. I have no other option to obtain evidence. I have to sit and do 100% checking. If option was there, then definitely Karthik sir would be teaching physics in probably some other academy. Clear? Right? So that is the logic of this point. There is no other option. There's a reason why I should do 100% checking. Right? Then repetitive nature or other process performed automatically by IS. This is actually a trend point now. Sir, because of AI, because of technology and because of softwares, we are moving towards 100% checking. In another 5 years, we will definitely be there. Another decade, 100% we will think of doing 100% checking because sampling is always risky. We do not know whether the sample, first of all, we are giving reasonable assurance, which is actually not 100%. Over that, we are doing sampling. So we are moving towards a 100% checking point. That is the reason here because technology, if it is there, everything I can check. Sir, Excel formula, you put 1000 entries, no problem. I can still sort it out in minutes. I just have to put formula and click copy and paste everywhere. I will get everything. Clear? So now imagine out of 1 lakh entries, I want to see whether double entries are there or not. One formula in Excel, it will flag. Therefore, because of IS, it is much more easier for me to have provided it is a entry of repetitive nature, meaning routine transaction. Non-routine, I cannot do anything. Routine transaction, IS can flag. Non-routine transaction, IS cannot flag. Okay. Now, selecting specific items. What are the factors? Understanding of the entity, assessing the risks and characteristics of the population. If you have understood the entity where entity is involved in all antique items and rare items, then obviously those are very expensive. Number one. Number two, the risk is high. If the risk is high, those items straight away I will select and start auditing them. Specific items include what? High value items, items over a certain amount. Example, debtors. I will tell all debtors above 50,000 check. This is what we technically do in bank audit. Clear? We check all the loans above a certain limit. Examining items. Why are we examining items? To obtain information with respect to nature of entity and what type of transaction the entity is entering into. Last time they had asked this specific items. Clear? Sampling is SA 530, nothing, three things. First, from the population, select the population first. Do you want debtors to check, creditors to check, etc. From the population, select a sample. From that sample, whatever you have selected, test it and then draw conclusion. It is not so easy though. SA 530 gives you detailed procedure as to how to select the population, etc. Okay, right. Now, in this, there is one logic I need to check with respect to what information is given to me. If the information is produced by the entity, blindly I should believe? No. If ICS is stronger, take it. If ICS is not stronger, do not take it. Rely on external information or external confirmation as such. So if entity has used management expert, what do we do, sir? No problem. They can still use management expert. Should I test it? Yes. I should test management expert's competence, his capability, his objectivity, and understand the work of expert. If I believe that fellow's work, then I can use the same work as evidence. Otherwise, I cannot use the same work as evidence. Very simple logic for that. Clear? Now, considering this base of SA 500, we will be talking to SA 501. Right? SA 501 is again same, nothing but audit evidence. Only three things we'll be discussing here. Inventory, first one. Litigation and claims. And we have segment reporting. Segment reporting. So, three things are there. inventory, litigation and segment reporting. In that, generally people say inventory is very important. No, in alternative attempts they have proved that even we will ask litigation also, we will ask segment reporting also. Let's talk about inventory. With respect to inventory, two procedures we have to put. One is basic procedures and one is additional procedures. Now, when should I consider SA 501? Standard says when inventory is material for the financial statements, only then perform these additional procedures. Otherwise, you need not perform SA 501. SA 500 is good enough. I repeat, when will we go for SA 501? When inventory is material to the financial statements. What do I mean by material to the financial statements? Significant, 30%, 40%, 20%, etc. If it is significant, then we'll have to go to SA 501. What is the basic procedure? Attending physical inventory counting unless it is impracticable. Sir, what do you mean by that? Management will prepare physical count and other things there. What we should do? We just have to go and attend. Remember, we are not supposed to physically count the inventory on our own. Clear? It is management who should do it. We have to go and be present there. In Caro also it is proved that we'll have to report whether management has done physical counting once at a reasonable interval and once in a year is what I had told you. That day you have to go. Now you tell me, is it possible for you to be present on the same day in multiple locations? Not possible. Therefore they have told unless it is impracticable to. Meaning, how much ever it is possible, please try and go and attend. If it is not possible, then we will see the alternative methods. Now, if you are going there, what you should do? You cannot change the order here. First, you have to evaluate. Second, you have to observe. Third, you have to inspect. And fourth, you have to perform. So, what do you mean by evaluate? Whatever instruction is given by the management to their people, whatever procedure management has given to their people, evaluate for what? Recording and controlling results, so that to avoid manipulation. To avoid manipulation of stock. Then observe performance of count procedures. So whatever they are doing, observe that. Inspect the inventory, perform the test count. So these are the four important things I'll have to do. Evaluate, observe, inspect, perform. Then imagine they are conducting physical inventory count on 1st January of 26. Okay. Now for us we require value of at 31/3/26. That means from 1st Jan 26 to 31/3/26, whatever has happened, we need to check properly. Clear? So perform procedure on final inventory records to know whether they actually reflect inventory records what we got in physical verification. So that manipulation should not be done. Imagine during inventory counting, you got the valuation as 10 lakh or 1 lakh units. Actual inventory result shows 1,20,000. Or final inventory record shows 1,20,000. Now I will ask, no, actual showed 1 lakh. How come final is showing 1,20,000? That extra 20,000 from where it came, I should ask management. But if it is 1 lakh and 1 lakh, good for us. Okay. Recent exam they had asked, what are the factors to be considered in attending the inventory count? Meaning decision, should I attend inventory count or not? That depends on these 8 factors. Technically 9 factors are there, but they have given only 8. I have given only 8 because I have combined 1 point, which is a common point. Okay. First, ROMM. I have given you the mnemonic also. Rest lean. Okay. R for ROMM with respect to inventory. If risk is high, you better go and attend. Clear? Why leave it to the management? If management is fraudulent, do you want to sit at home or do you want to be there? Be there. Number 2, expectation of procedures established and instructions issued. If the client place, you know that they are not following instruction, they will do whatever they want. You know that is what your expectation is. You better go and attend rather than sitting in your office. But if you expect that they are following, sir, they will definitely follow, then I need not be present. Third, stages of completion of WIP inventory. If you have seen costing equivalent production method, you will be getting every problem will give you X number of percentage. this much is completed, this much is completed, equivalent production, you convert that into. In those cases, no, understand what is a percentage completion and then you can decide whether you want to go or not. Then, timing of physical inventory counting. Sir, your timing and my timing is not matching. If it is matching, you go. If it is not matching, you need not go. Location at which inventory held is important. Materiality of the location and ROMM. Now, this is a very good point. Imagine ArivuPro has 4 branches, right? Bangalore 2 branches, we have Coimbatore and Chennai. Imagine Chennai branch, the people in Chennai branch who is doing inventory count, they are very fraudulent people and they can manipulate the amount and units there. Do you want to be present in Chennai or Coimbatore? Chennai. But if you say that Coimbatore people are good, sir, here, they are not going to do fraud and all those things, then I need not be in Coimbatore. I have to select Chennai. But if I get to know both, in both points or in both locations, there are fraudulent people. What do I do now? Can I be present in both places? I can't be present in both places. I'll have to send one of my persons to Chennai and I will go to Coimbatore, or I'll go to Chennai, my other person will come to Coimbatore. So basically, location materiality. Now, in this example, I gave you location risk. Now, location materiality means what? Imagine for 4 branches, Chennai has the biggest inventory facility there. Where should I go and first visit? Chennai. Coimbatore also has inventory, but not as big as Chennai. So, Chennai inventory contributes more to the asset size of the entire organization. So, there I should go. Coimbatore, I need not go. It's okay if I don't go because material location is Chennai. Okay. Here, when they say materiality, important location we are talking about. Then, inventory system. Are you following perpetual system or periodic system? If what do you mean by perpetual or periodic means? Perpetual means there is no balancing method. Periodic means once in a month you balance or once in 15 days you balance, etc. So perpetual or periodic, you have to see your work will be more if it is a perpetual system. Your work will be less if it is a periodic system. Expert, is expert assistant needed or not? Requires in case of pharma, requires in case of those inventory where you do not know the quality, you don't know how to check the quality, etc. Chemical, fertilizers and all those things you require expert. Nature of inventories are perishable. Yes, you better go there. Nature of ICS with respect to inventory. If ICS is lesser or weaker, it is better if I be present there. If ICS is stronger, I need not be present there. Now, your important area of SA 501 inventory, additional procedures. So, there are 4 scenarios. Scenario number 1. Conducting on a date other than balance sheet date. Meaning what, sir? The management has conducted physical inventory count, but I was not able to be there that day because I had to be in some other place. Now the question is, they have done their work. They will not wait for me. Should I go and count again? The answer is yes. If you want, you can conduct the physical count on a date other than balance sheet date. If you are conducting other than balance sheet date, it should be either before or definitely after balance sheet date. Whether you do before or whether you do after, what should you do? Follow basic procedure. What does follow basic procedure means? Identify, observe, perform, evaluate, etc. Perform procedure to obtain evidence with respect to counting date and financial statement date. What is financial statement date? Let's say, for example, 31st March 26 is the balance sheet date. You take up a count on 10th April, or if it is before, you take up a count on 28th February. From February to March, whatever transactions happened, check that. From March to April, if you are taking on 10th April, whatever transactions happened here, check that. Here you give reversal effect. Here you give forward effect. Clear? So imagine you have taken on 28th February. Here you got 10,000 units as a closing stock. From 10,000 units, we have to reach to March. So if it is a purchase, add, units will increase. If it is sales, reduce, units will decrease. Sales return, add, units will increase. Purchase return, reduce, units will decrease. So like that, give adjustment to, and these type of transaction is what we call as intervening transactions. in between transaction is what we call perform procedures for in between transactions. So check whether perpetual records are adjusted. Reliability of inventory records, you see whether invoices are fake or original. Reasons for significant differences you ask. Okay. My second scenario, sir, unable to attend due to unforeseen circumstances. Here, it is not about impracticable. Here, unexpected situation I am in. For example, let's say the CA was going to the client's place. He met with an accident. Can he go now? No. Sir, CA's marriage is fixed on that day only. Can he go now? Not possible. Clear for him? Of course, he can't prioritize work now. Clear? Family function is very important. Now, those days, you think management will wait for you? Matter what? Management tells, sir, you get married for us, work is very important. Now, in that case, due to unforeseen circumstances, I was not able to attend. What to do, sir? No problem. Conduct physical count on an alternative date. Perform procedures on intervening transaction. You only conduct a physical inventory counting on some other date and intervening transaction. Meaning, what is intervening transaction? Those between count date and balance sheet date or financial statement date. Next, situation number 3. Attendance is impracticable. Lockdown, COVID, riots, hijack. In all such situations, will you go for inventory valuation? No, it is impracticable for me to reach there. In those cases, you are only left with alternative procedure. If you are not able to put alternative procedure, you modify your opinion as per SA 705 qualified adverse or disclaimer as the case may be. Situation. What are the situations, sir? If the nature or location is posing threats, you need not go there. Example. Terrorist attack. Would you want to go and do inventory count? Or would you like to be inventory? Clear? So that is very important for us. Clear? Riots have happened. Would you like to go through the place? Not possible, sir. Don't want. During COVID, second wave specifically, I think the zone was called as contaminated zone or something like that. One zone, they used to give a name for that zone. Everywhere they will leave, but one area, very, very sensitive area, they used to lock that entire area, seal that entire area. Now imagine a client has an inventory in that area. Can you jump the barricade and go? Not possible. So attendance is impracticable and the situation is posing threats to the auditor's safety. Sir, if I am only not safe, who will do the audit? Clear? So in those cases, alternative procedures only are left. Financial year 2021. Financial year 1920 also, no, some organization had given problems. Reason being is, in 1920, lockdown was announced in the March last week. Clear? I don't know if you remember. Right? Now, March last week, lockdown was announced, correct. Those organizations who did not do physical verification of inventory, they were waiting for the March and they were not able to do. Now, March 31st, you have to give balance sheet. Clear? The inventory valuation of March 31st, they had given in their report as we are not able to obtain SAI for inventory only because of lockdown. Now, for that, I had to modify the opinion and give. But users did not feel bad because users knew it was because of COVID and not because of any other things. Clear? That time, users will say, no problem, sir. Even if you have been modified, we will be with you only, don't worry. Clear? So, those are impracticable scenarios. Next, it is in the custody of third party, customs department, clear, excise departments. Then your friend's stall or shop, you have maintained your inventory there. Consignee, you have maintained your inventory with the consignee. Clear? Then sale of goods on approval or return basis, it is with the third party customer. Everything will come here. Request confirmation from them. Inspect the inventory. Go there and inspect the inventory. Or if you can't do any of that, perform some other procedure. Ensure you get evidence about two things. Whenever we are talking about inventory, we want two evidences with respect to. One is existence of inventory. One is condition of inventory. With respect to existence and condition, we want more details. That is your inventory point. Now talk about litigation point. What do you mean by litigation and claims? Filing a case on the company. So in case of the litigation and claims part, how do we obtain the evidence whatever company is selling is true or not? We do not know. Here, three parties are there. Okay. Party 1, management. Party 2, internal counsel, that is in-house legal counsel. Then we have external counsel. Clear? So you have three people: management, internal counsel, and external counsel. We have to talk first of all to whom? Management. Then we will talk to whom? Internal counsel. Then we will talk to whom? External counsel. Who is internal counsel? Management's people only. External counsel is who? Independent guy. Clear? So first we will inquire management and in-house legal counsel. We will review three things: minutes of the meeting with TCWG, what they have discussed and decided, and what is the action they are going to take. Imagine I filed a case on your company. Okay. Now let's say you are a Red Bull company. I filed a case on you. You told me it will give me wings and I did not get wings. You better give me wings or give me compensation. Clear? And this is an actual case. Clear? Now, when somebody has filed a case on you, you are the management. Tell me, will you take it seriously or will you take it lightly? You'll definitely take it lightly, because you'll be like, which loose person drank Red Bull and did not give wings and filed a case, it seems. Why should we take it seriously? Leave it. Now, when I talked to management told nothing will happen, sir. These people are mad, jobless people. India, high rate in unemployment, no, one of them is CA only. I said, okay. I went to internal legal counsel. I asked, see, management is saying nothing will happen. You tell me. Now, in-house legal counsel said, actually, case is there, sir. Because we are claiming it gives you wings. That's what we are claiming, and this fellow is right in filing a case. Court will accept it. Now, management is not ready. Internal counsel is saying, yes. What should I do now? What should I do? I should trust whom now? Internal counsel or management? Why? Because internal counsel is an expert in that particular matter. So I will tell management, sir, you make provision for this. And management is like, sir, what has happened to you? Are you drunk? Why should we make provision for such nonsense cases? No, but internal legal, you leave them, sir. They are also jobless. Now you tell me, what should I do? There is a difference of opinion. I will go to TCWG, SA 260. I'll go and tell, see, I communicated, they are not ready to make provision. You tell me what to do. If TCWG also says, correct, no, sir, whatever management is saying. Who will file case on all these things? You leave it, sir, nothing will happen. In my opinion, I will modify. If I believe internal legal counsel, then I will modify my opinion saying either qualified or adverse. Clear? Right? Because case is filed, provision is not made, SAI is available. Therefore, I'll either give qualified or adverse. Clear? But I can't directly, go and give opinion. I should read the minutes book. Correspondence between entity and external legal counsel, because they would have taken a second opinion with an external legal counsel. And I will ask that guy, sir, what do you think? Now, external counsel also is saying, actually, correct, sir. Whatever case is filed is correct. But management is not creating provision. What can I do? That I can't do anything, sir. But as far as legal point of view is concerned, case is absolutely valid. Yeah. Now, in that case, I will either modify my opinion and I will give management to create a provision and give unmodified opinion. Okay. Legal expense account, you see. Now, you tell me, if there is nothing to worry about the case, why are you paying lawyer the fees? Chuma? Pongal bonus? Diwali bonus? If you are paying fees to the lawyer, that means definitely something is wrong in your case. Right? So, review the legal expense account. Obtain direct communication with external legal counsel. This is an important question. Clear? From external legal counsel, take a direct confirmation and ask him, sir, I want to come and talk to you. So, for that, you have to send a letter called letter of enquiry. In that letter of enquiry, what should be the content? Three things must be there. Number one, list of litigation and claims of your client. Of your client, ask what all list is litigation and claims list is there. Please give it to me. I will send it to ELC. Then also tell the external counsel what management is thinking of such cases. what is their point of view. Then request him to confirm the reasonableness of management's evaluation. So ask ELC, sir, this is what management has told. You tell me your point of view. This is number of cases. This is management's point of view. I will give it to you. You read, tell me your point of view, and also give me more information if the list is incomplete. Now ELC may read and say, oh, only 5 cases, sir, 15 cases are there. They have given only 5. So okay, sir, the rest 10, you put 10 give in the list. Clear? So ELC may have a better idea about this. Now, you tell me one logic. If a client comes and tells you information, should you tell it to others? If a client comes and shares information with you about the client, should you tell it to others? Why? Confidentiality. Theriyudilla. You are getting to know, no? And you are going to a lawyer and asking about his client's information. When somebody comes and asks you about your client information, will you give? No, hypocrites only. I will not give, but if I go to a lawyer, he should give his client's information. And he will tell, can you see something written on my forehead? I mean, can you see C, cute? No. So definitely I will not give you any information, provided the law has asked me not to give. If law is permitting, then no problem for me. But if law, because they generally have privilege, whatever information is given to the lawyer, it should not be spoken to outsiders. That means they are breaking the confidentiality clause. But if it is already spoken in the court of law, that I can share, no. Because there, whatever I say, it is in the public only. Clear? That I can share with the client. So if the law prohibits, then I can't force him. But if the law does not prohibit, then I can continue with my audit work. If law prohibits, you can't do anything. You can't pull that collar and say, hey, give information. You can't force him, because even he is bound by ethics. Now he will ask one thing, if my certificate is cancelled, my license is cancelled, you will pay compensation for that. No, I can't give you that information. Find someone else. So you can't force them. You have to do some other procedure. Situation where I need to meet ELC and discuss. Clear? Very important. When should I go and meet him, sir? Number one, if the matter is a significant risk. If the matter is complex and there is a disagreement between management and ELC. So if external counsel and management, they have some fights, difference of opinion, then I can't talk from him. I have to go and meet him directly and ask the information. Very important point is, you can't meet him without management's representative. You have to meet him with management's representative present. Why? What if that guy gives information which is not supposed to give? What if you give him the information that you are not supposed to give? Therefore, I will have my person coming with you. Now, if you ask management, do you not trust me? No. I don't know what information you guys will share. Therefore, my person also will sit with you. Reporting requirements. If management refuses to give permission, modify the opinion. If ECL refuses to respond to the inquiry letter and you are not able to obtain SAI by performing alternative procedure. See, this is one scenario. This is one scenario, and these both are one scenario. What is this first scenario? Refusing to give permission, modify. Here, ELC, that is external legal counsel, or ECL, external counsel, is not responding to my inquiry, which is nothing but he is not sharing information. I should perform alternative procedure. Even after performing alternative procedure, if he is not able to give me any information, then I will modify the opinion. Clear? Now, here what mistake you will make is, here you will read this as a separate isolated point. If he is not responding, we'll modify. No, Baba. If he is not responding, don't modify. Perform alternate procedures. In alternate procedures, if you are not able to find anything, then you modify. Okay. Segment information. Now, what do I mean by segment information here? Accounting standard 17 talks about segment reporting. So, whenever you are giving the segment information in the financial statements, here I am bothered only about disclosure. My botheration in SA 501 is just to check, have you disclosed information to the users Have you disclosed information to the users according to your applicable financial reporting framework? That is what we need to check. So whatever presentation and disclosures you have put, you have to first obtain SAI with respect to that by doing what? Understanding the methods used and performing analytical procedure. For example, for different organization, segments are different. For ITC, we had seen ITC agriculture different, cigarettes different, FMCG different, clear? Then paper boards, packaging and all is different. So we need to understand, go and ask the management, how are you dividing your organization into segments? And have you reported according to the segment reporting standards? If yes, then I'll give unmodified opinion. If not, I will give modified opinion. So I need not perform any additional procedures on SI to give opinion. Just have to check presentation and disclosure. Do not check anything else. It should be presented and disclosed as per the requirements of the relevant accounting standard. Clear? Right. That's your essay 5, not 1. More focus should be given on inventory. That doesn't mean litigation and segment cannot be asked. They have asked segment information also for 4 marks before. But inventory is where I can actually play with your paper. Next. Essay 505 talks about external confirmation. When we talk about external confirmation, what do you mean by external confirmation? Talking to the external parties without any bias, they should respond to me. If they have bias, then I cannot trust their words. Now you tell me, when do you go for external confirmation? If ICS is weaker. So if ICS is stronger, will not go over. For specific, now my question to you, he said for specific assertions we can go. That means you are still not believing ICS. Yes or no? If ICS is stronger, don't you believe that whatever information your management is giving is true? That's the point. If ICS is stronger, I need not depend on external confirmation. So generally, external confirmation we will go when we do not trust the ICS, which is most cases. Clear? In most cases, we'll go for external confirmation because of not I don't trust you. It is not because I don't trust you. It is because you may not know what it is. Clear? Like for example, you think clients know everything about everything in their financial statements? Then why are you there if they know? Clear? You are there because they don't know anything about it. Therefore, I need to understand that they may not know certain things. For that, they would have not updated their passbook. They would have not gotten into any updation of their books of accounts. Therefore, I will ask an external confirmation guy. Clear? Now, debtor would have paid cash. Debtor would have paid cash. Management forgot to record it. It need not be fraud. It could be error also. So, I will talk to the outside person. Proprietor. Now, you go to the cashier, you ask for money from the proprietor, from the accountant of the proprietor. The owner asks, give me 50,000 rupees or 1 lakh rupees. He gave 1 lakh rupees. Now, what will he record it as? Drawings. Correct? Because from his point of view, who took the money? Owner took the money. Therefore, it is drawings. Now, owner goes out, meets a creditor, makes a payment and comes back. Technically, what payment he made? Creditor's payment. But what is the entry in the books of accounts? Drawings. Now, in the finalization, the creditor is still shown as 1 lakh only. The boss says, what 1 lakh? I paid him. How can he say 1 lakh? Now, how do I know? Yes or no? Error has happened. So, I will call the creditor and ask, sir, did this fellow make the payment? Yes, sir, that. He has made 2 months ago only, sir. 2 months ago. When, sir? Now, he'll give me a date. Now, I will check that date from in the books of accounts. It is entered as drawings. Now, through boss will call accountant. Why did you enter drawings? Sir, you didn't tell me for what. You just said give me money. I gave you money. So management may not know certain things. That's why I have to go for asking external confirmation. There are 4 types of confirmation according to ICA. One is called positive confirmation. What is positive confirmation? party directly responds to the auditor indicating agreement or disagreement. Sir, whether you accept, whether you don't accept, in both cases you have to respond. Responding is what we call as positive confirmation. What is negative confirmation? You respond only when you disagree. This is what we call as negative confirmation. Now, positive confirmation is what? Responding. Negative confirmation is what? Responding only when we disagree. These are suitable only in these scenarios. Scenario number 1. You assess that risk is very low. Why, sir? What is the logic here? Tell me one logic. When we talk about negative confirmation, he will respond only when he disagrees. Meaning, how do I know that he has got my letter or not? There is a risk of him ignoring my letter. There is a risk of him not responding at all. He doesn't know only. Now, in that case, what will I assume? He doesn't have any problem. These things are very risky. Therefore, they're telling, don't use negative confirmation in all scenarios. Exam question this is, when should I use negative confirmation, sir? In 4 scenarios, ROMM assessment is low. Population is homogeneous item. If not you, I can ask someone else. Exception rate is very low. That means my expectation of giving wrong answers is very low. More often than not, he will respond, sir. Auditors unaware about behavior of user to disregard. Meaning, I did not know he will ignore my letter. So, I just sent it. That's why standard says it is always better to send positive confirmation request than negative confirmation request. Clear? Okay, what procedures, sir, to send? I'll have to send, what are the procedures? Number 1, whether information to be confirmed or requested. Sir, what do you mean by confirmed or requested? When you're asking for information, it's a request. When you have the information, you are confirming. But what if in both cases I have the information? It is the way you ask. Clear? For example, if father says, do you have something to tell? What does that mean? Does he know or does he not know? When a father asks, do you have something to tell? It means he knows and he just wants to confirm. Clear? But if mother asks you, where are you? Now you think she doesn't know. That's the point. That's why I told you, the way you ask. Clear? If you say, hey, what's that? Day before yesterday, where were you? Now your mother has seen you where you were. She'll not ask you directly. She'll ask indirectly, where were you? Now you will tell, I was in academy. Now she saw you in a park. Studying in isolation. Of course, the subject matter could be different, but you were studying. Okay? Now she saw you there, right? And imagine there only she calls and asks you, where are you? And you are talking very slowly. I'm in class, I'll call you later. You're there only. She's standing right in front of you, not seen. Now the question is she confirming or she requesting? It's confirming. What do you mean by requesting information? We asking the information without telling the opposite party that we have that information. So what is better? Confirming is better or requesting is better? Always requesting is much better. Because if you say confirming is better, no. That fellow will tell, yes, this amount only. This whatever you told, that amount only. But if I request, no, you give me the amount. No, what amount you have, you tell me. You give me the amount. Then I will tell you what amount I have. So when you request for the information, the matching will be much better than confirmation. Clear? Now imagine management will tell that guy, auditor might ask you, this is the amount, tell yes. Now that's where you flip googly. Don't ask at all. Give me the information. Clear? Now if he gives you one amount, compare that amount with amount that you have and then take a call. Okay? Next, selecting the appropriate party to confirm. You want to ask information from Karthik sir. You are asking information from Karthik sir's father. Now, and you are telling, I did not get proper information. From whom did you ask? Clear? Now, imagine you ask me, when are you going to finish the portion, sir? Now, I will not tell you, and you are going and telling everyone that ArivuPro doesn't finish portions on time. Now, they will come and, did you ask me? No, I asked Karthik. Karthik, sir, is just a teacher there. How can you ask him? Select the appropriate party to confirm. Randomly, don't go and ask the client. See in the client who is the responsible party who I can ask. Clear? Then design confirmation request. Now this designing will depend on certain factors. What are those factors? Specific ROMM. If risk is high, my design will be different. Layout and presentation. Should I ask the information or should I confirm the information? Accordingly, I need to present the content. Prior experience. If you already have experience of asking such questions, then it is much better for you to design. Assertions address. What are you asking? Amount are you asking? Date are you asking? Party are you asking? What are you asking? Method of communication. Should I directly go and give, or should I send an email? Should I send a letter? Should I call and ask? How? Management's authorization and encouragement. Since these people are outside the organization people, we require the authorization or encouragement of management. Otherwise, we cannot go and ask. Ability of the party. Sir, you decided everything, but you got to know that the party can't talk. Clear? The party is in hospital, coma. You will go and ask confirmation there. No, not possible. Ability I have to see. Sir, when the transaction happened, the party was sound mind. Now he is of unsound mind. How we can ask confirmation from him? We have to select a different party. Clear? Then, once you send, don't keep quiet. Follow-up request must be there. What do you mean follow-up? Asking again. For example, you raise a ticket at ArivuPro. You will get a call. Yes. Once ticket is resolved, again you will get a call. Yes or no, whether it got resolved or not. That's called following up. Okay. What if management refuses, sir? Management says, I will not let you go and talk. Clear? I'll ask management, what is the problem? Clear? Don't get angry on them. First ask, why ma? Why can't I go and talk to them? Now they will tell, because I don't like. This is very bad. If this is the case, then I will modify my opinion. But if you are telling, sir, you can't go, sir, understand, sir. I'm like, no, I will go. Sir, he's dead. You will go for confirmation? You can't. Now there, the reason is valid. I have to select a different person now. Then I will ask management, if he is dead, then why are you not writing it off? No, sir, his son has told he will pay. Okay, I will go and ask confirmation from the son. Okay, no problem. Evaluate the effect on risk and NTE of AP. Tell me, if management refuses, no, now we start doubting management. Why is this fellow not allowing me to go and talk? Risk could be more. ROMM could be more. If risk is more, procedure also should automatically increase. Perform alternative procedure. After performing alternative procedure, if I am still not able to obtain evidence, modify your opinion, communicate with TCWG. Or if refusal is unreasonable and you decide to withdraw, communicate to TCWG, or rather than withdrawing, you can also modify the OP. So basically only 5 procedures for SA 505. What is the first procedure? Whether confirmation or request, selecting the party, designing the request, send follow up with the request, and in case of management refuses, what am I supposed to do? Okay, that is your SA 505 external confirmation. Now, my personal favorite standard, SA 510, which talks about initial audit engagement. When we talk about initial audit engagement, we are talking about one specific point where we require opening balance. Now, initial audit engagement means first time we are doing the audit. Okay. Now, it could be the financial statements for a prior period were not at all audited. That means first time for the client also, first time for us also. We have never done his particular work. For him only it is first time audit. Second, he has done audit, sir, but with me, it's a first time audit. Clear? That means he had an X. Clear? Some other auditor had done the audit before. Therefore, the balance sheet will keep on carrying on. No. Clear? In these two scenarios only where SA 510 will come into the picture. Now, what are the two scenarios? Remember in the question, see what is the scenario first. Only in two scenarios SA 510 will come. Scenario number 1, where client only is getting the audit for the first time. Number 2, the CA is getting that client's audit for the first time. In both cases, SA 510 will be applicable. In what scenario SA 510 is not applicable? That's logic now. Think and answer. I have done the audit of that client every year. Clear? Last year also I did the audit. This year also I did the audit. Will SA 510 come into the picture? No. Why? Because it is not the first time for him also. It's not the first time for me also. Clear? Right. If the financial statements were not at all audited till now, then first I should check whether opening balance is correctly brought forward or not. First of all, to bring forward opening balance, closing balance should be there, which means I have to first sit and analyze closing balance. Okay. So what is my objective? To obtain SAI with respect to two things. Remember, we start with objective, we end with objective. What is my objective? To obtain SAI about number one, whether opening balance has any misstatement. Second objective is whether accounting policies are reflected plus consistently applied in CPFS. That is, CPFS means what? Current period financial statements. So number one, whether opening balance is correctly brought forward. Number two, whether accounting policies are reflected properly or not. Now, what do you mean by opening balance? Last year closing balance is current year opening balance. Very simple logic. Clear? But they have given nonsense meaning here for us to understand. Balance at the beginning of the period, closing balance of previous period. It reflects T, that is transaction, events and accounting policy of prior period. You remember only one thing. What is opening balance? Closing balance of previous period, balance at the beginning of the current period. Listen to me carefully now. They have used the word current period and not just year. Because when quarterly audit, when we do, Q1 and Q2 are two different periods, although same year. Clear? Right, sir. What are the procedures, sir? First of all, closing balance should be correctly brought forward. Because everything is right. When you bring the amount to the next period, there can be misstatements. But with the systems now, this is easy. But manually, when you do, there can be errors. Clear? Manually, you are only writing the amount, there could be mistakes. Any adjustment, if it is there, disclosed as prior period items, and this is what you would have seen in your accounts. Clear? In foundation accounts or your 11th, 12th accounts, where they say last year closing stock was overvalued, opening stock was undervalued. Where do you adjust that overvaluation, undervaluation? Current year financial statements you adjust. Therefore, show it as prior period items. Understood, sir? Next, any changes if it is there, updipod, APD, accounted, presented, disclosed as per AFRF. Sir, can I change accounting policy? Of course, yes. In two scenarios, which is that changes required by law or better presentation, but disclosed as per AFRF. Proper disclosure should be given. Opening balance should reflect accounting policies followed. Do more than one of the following. So basically 5 procedures, sir. What is the first procedure? Correct, brought forward of opening closing balance. Number 2, any adjustment if it is there, PPA checking. Number 3, any changes if it is there, APD, accounted, presented, disclosed. 4th one, accounting policy should be same. 5th one or more of the following. What is that? If last period financial statements were audited, go and study the audited copy. Why, sir? Last year auditing means closing balance I will get to know, so I can check the opening balance. But if not, then I can't do anything. Procedure for opening balance evidence you have to apply and perform specific procedure. This specific procedure is chapter number 5, meaning do TOD. Do more test of details. Procedure for opening balance, what we should check? See whether it was proper accounting policies followed or not. What type of ABCD? What is ABCD? Sir, balance sheet items will be having a different balances. P&L items will not have a balance. I hope you know that. P&L items will not have a balance. P&L item will nothing be carried forward to P&L and a net effect is given. But at the same time, if you know accounts properly, every ledger will have a balance. Every ledger will have a balance. The only difference is expense and income balance at the end of the period you transfer to profit and loss account and keep. Whereas the balance sheet item balances you will never close. P&L item balances you will close and transfer to P&L. Balances will definitely be there. But but closing balance will not be there. So see what type of items we are testing. Significance of opening balance with respect to CPFS. If it is required, only you put. If it is not required, you need not put it. Clear? Significance. Then, if last period were audited, was it modified? Why it is modified? In SA 560, we have seen subsequent events. If there is any facts got to know after audit report date, financial statements will be amended. Yes, that amendment, if it is made, check whether amendment is made properly or not. And if CA has given modified opinion, check on what he has given modified opinion. Now comes reporting part of it. What should I report, sir? With respect to consistency and of accounting policy, I told you objective, starting with the objective, ending with the objective. What is our objective? To check whether opening balance are properly reflected and accounting policies are properly reflected. Now, first of all, accounting policies are properly reflected. If you conclude that accounting policies are not consistently applied, then you qualified or adverse. You should apply consistently, you did not, therefore I'll give qualified or adverse. If you have made any changes, we already have studied, if you have made changes, you should do three things. Account for it, present it, disclose it. And if you have not done that, I will give qualified or adverse opinion. So in two scenarios, I will give modified. What is that? Not consistently applied and not adequately accounted for it. I will give what opinion? Qualified or adverse opinion. Now I'll tell you why. Okay, come to this part. With respect to opening balance, if you conclude that you are unable to obtain SAI, then you give qualified or disclaimer. If opening balance includes material misstatement affecting the current period financial statement, such a misstatement is not accounted, presented, disclosed. Give qualified or adverse. Why? Answer and tell me. Here, why are we giving qualified and adverse and why not disclaimer? Because we have evidence that material misstatement is there. It is affecting my current period FS. And that material misstatement you have not corrected at all. Therefore, I am giving what opinion? Qualified or adverse. Here, why am I giving disclaimer? Sir, I don't have any evidence with respect to opening balance. Because you tell me, what is the formula for closing balance? Closing balance formula is what? Opening balance? Now, do not tell me opening balance plus purchases minus sales and all. I am not asking you about units. I am asking you for any balance I can calculate opening balance. So, closing balance is equal to opening balance plus or minus during the year transactions. During the year transaction. Clear? Now, in this, during the year transaction is what we do audit everywhere. This standard specifically talks about what? Opening balance. If anyone goes wrong, closing balance will definitely be wrong. Clear? So, both should be correct. Right? So, in that case, here, if I am not able to obtain SAI with respect to opening balance at all, I won't be able to give opinion on closing balance also. Therefore, I tend to give what opinion? Disclaimer of opinion. My question to you, now comes the googly question. Here, I can give qualified, I can give adverse, I can give disclaimer. Whereas here, I can only give qualified or adverse. Why is that? My question to you, their disclaimer scenario came. Here, why disclaimer scenario is not there? There we tend to say that we are unable to obtain SAI for opening balance. Here they will never tell we are unable to obtain SAI for accounting policy. Why is that?
Because they have to disclose.
Sorry?
Management have to disclose their policies. They are responsible.
Okay, if they don't disclose it, still see, if they have not disclosed it, we'll still give adverse opinion. Why can't we give disclaimer? You're saying something.
Without policy, we cannot prepare.
Correct. Absolutely right. Without policy, tell me one entry that you can follow. Without accounting policy, can you pass one journal entry? You can't. Without accounting policy, tell me one journal entry. Not possible. Absolutely not possible. Accrual, accounting policy. Depreciation, accounting policy. Clear? Matching concept, accounting policy. Without accounting policy, there is no accounts. Either you will follow wrong or you will follow right. But there is no way you will say, I am not following any policy. Clear? Otherwise, you can't prepare books only. That is the exact reason why here you will never see disclaimer. You will only see two things, qualified or adverse, because here there is no chance you will tell I am unable to obtain SAI. And if a CA says I am unable to obtain SAI about accounting policy, you are not a CA. Because logic, without accounting policy, there cannot be books of accounts, and without books of accounts, I cannot go and do the audit. Clear? That's the logic of this scenario. This is where I can test you in the exam. Be careful. Okay? If you want to write somewhere, without accounting policy, there cannot be books of accounts. Next. This is essay 510. That is a killer question. In reporting, that is a killer question, but don't worry. So much testing and all they will not do. If I become question paper setter, I'll ask, okay? That is your essay 510. At final level, they can ask that. Clear? For sure. Maybe if we are able to give suggestions, maybe they can ask you whenever you're writing. Let's talk about 550. Again, I repeat, can we ever give disclaimer for not having accounting policy? No, we'll be end up only two things we have. Either qualified, technically three we can give: unmodified, qualified, adverse. Disclaimer never ever you can give. If I see an answer with disclaimer of opinion for accounting policy, no, I will not even read that answer. Straight away 0 will give. Clear? Next, essay 550 related parties. Very easy. Clear? This and Indian Partnership Act is like cousins. Both follow same type of format. Indian Partnership Act, if you remember in your foundation, it is always very relaxed act. Yeah, it doesn't irritate much. Very easy unless Indian Contract Act. Right? IPA is very easy. It says you guys deal. Whatever you guys decide is law. But if you guys don't decide, then you come to me, I will decide. And what does IPA decides? Nothing. Same logic SA 550 says. SA 550 says, if there is any other law which has defined who is RP, please follow that. Don't come to me. If nowhere on earth they have not defined, anywhere they have not defined RP, then come to me, I will tell. Clear? And this also does not tell. It doesn't tell you the relation. It tells you the formula for the relation. Clear? Like how Indian Partnership Act says, salary problem you guys have, you guys not decided salary, no sir, but I am working 12 hours in a day, 18 hours in a day, this fellow doesn't work only. Okay, you guys did not decide, okay, I will decide. No salary for anyone. That is Indian Partnership Act. Clear? Then, interest on capital. Sir, I put 20 lakhs capital, this fellow put only 50,000 capital, sir. Clear? Oh, you guys didn't decide interest on capital? No one will get anything. Clear? That is IPA. IPA is very easy to understand. Clear? Because it doesn't want problem. And the very solution for not having problem is don't create problems. Clear? Act only does not create any problems. Same logic here. They never tell you the relationship. They just tell you the formula for relationship. Understood? Clear? Now, for example, it is like telling, I will not tell that, let's say, for example, who should I take now for the example? I'll take you. I'll take this guy, Lakshman. Now, imagine Lakshman is going with a friend. Okay. Now, I will not tell the relationship of his and his friend. But I will come and tell Hari, Lakshman actually was holding hands of one girl and walking. Now, did I name the relation? No. Now, who is naming the relation? Hari is naming the relation. I never named it. So, tomorrow when Lakshman comes and says, sir, how can you tell that friend is my girlfriend? I never told. I just told a formula. He named it. In SA 550, you will never see holding subsidiary and all. You will just see one person controlling another person. Now that you name it as holding subsidiary, you name it as associate, you give whatever damn name you have. But we will not name it. We will just tell you the base of that particular relation. Clear? Reporting entity having control or significant influence over other person. You both are RP. Example, husband and wife is RP. Of course. Brother and sister RP. Yes. Father son RP. Yes. Mother father RP. Yes. Now if you see, everyone is RP. Meaning some person is having control or influence over other. So it is very wrong if I say the relation. Clear? Rather than that, I will tell you the formula to calculate that relation. If an entity is having, entity means what? Our client. If our client is having control over another company, both are RP. If our client is having influence over another entity, both are RP. Clear? Other person having control or influence over our client, still RP only. Now, so many relations I told you. Now, you having an affair with someone else, that is also RP only, no? It's a different matter whether it is legal or illegal, but still an RP, yes or no? So, this is what we call as related parties in the corporate way of telling. Clear? Now, see, one company, you have 1% share, still you are an RP. You have 20% share, still you are an RP. 60% RP, 100% RP. Clear? Any percentage, if you are having influence, what type of influence? Significant influence technically will not come with 1%. Because Companies Act today has defined how much? 20% should be there for you to have significant influence. Or common control, brother and sister, relative, because parents same, no. Yes or no? So common ownership is there. Or close family members are owners. This comes from our US, UK, Switzerland, those type of business. Because foreign companies, that is they right from traditional times, no, they believe in family business. Clear? They give their succession to their own family member only, right? But until and unless somebody comes and snatches everything away. Clear? Like what happened in Louis Vuitton brand. Louis Vuitton always had a family business. He started a brand, gave it to his son, right? And his son became over smart and went for listing. Somebody took 51% stake and the Louis Vuitton brand is no more Louis Vuitton's brand. Clear? And then he started taking decisions for the company, started merging all premium brands and tried to take it to a next level. Only good thing is the name was not changed. Clear? Now in such cases, no, when they saw this, most of the companies, family businesses decided that we will never go for listing or will never allow a stranger to buy shares in our company. That is exactly where private companies restriction come into the picture. You cannot transfer the shares without AOA's permission or director's permission because of such people only. Okay. Then control means what? Making rule or administering the entity. So the one who makes rule also is a RP in the company. Influence, power to participate. Sir, in influence, no, you don't have the power to make rule, but you have the power to influence the implementation of the rule. Now in ArivuPro, you don't have the power to decide whether we should start the batch or not. Clear? But you can influence the decision of that whether it should start or not. You can't decide on it, but you can influence. If everyone says will not come, then ArivuPro is forced to cancel that particular batch. But they have to announce first. No, you can't decide. Don't announce only. So you have an influence. They have control over the policy. They'll make policy, but whether the policy will become successful or not, it is in whose hands? Your hands, because you are the one who is deciding on that. Clear? What are the other ways, sir? Equity holdings. Having equity is one more way of becoming relative. Entities holding in other entities. Company holding in another company. One company investing in another company. One firm investing in another firm. being part of TCWG. Now transaction between you and company will become RP. Having significant business relationship with TCWG. Hey, this is very important. Don't cancel out business. You should have business relationship with TCWG. What do I mean by business relationship? Trading. Trading of goods or providing of services. Okay. What are the procedures? Very simple procedure. First, inquire with the management and ask, do you know anyone? Identity, ask if there is any changes. Because probably you would have changed your RP. Last year you had one subsidiary. You sold all the shares. This year you have one more subsidiary, new subsidiary. Ask identity including changes. Then nature of relations. What type of relation you are having? Is it subsidiary relation or JV or associate? And did you guys enter into any transaction? See, for example, let's say for example, how your mom inquires about these. Right? Imagine your mom sees you with someone. Mom, first question she will ask, who is that person? Identity, including the changes. Last time I saw you with someone, now I am seeing with someone. Who is that? Who is this? Clear? So she wants to know about identity. Next, you will tell friend. She wants to know the nature of relations. What type of friend? Clear? I have not seen such a friendship. You are holding hands and walking. Clear? What type of friendship? Subsidiary, JV, associate, or only significant influence you are having. Clear? What type of friendship it is? Any transaction you guys entered into business transaction. Clear? So I want to inquire three things. Then obtain understanding of ICS if they have. Clear? Now what do you mean by that? Does the entity have an ICS to identify these type of transaction or flag these type of transaction? If the system doesn't flag, no, then it is very risky for us to identify what transactions are happening. So do you have an ICS to identify RPT and RPR? Audit committee is one of the examples. Clear? If audit committee is there, every related party transaction has to be passed through them, has to be approved by them. Clear? So do you have any systems like that? Do you have any system for authorization and approving the transaction which is outside normal course of business? Right? Imagine you give something for free. Clear? Which you will never give for free. If you have a business, clear? In Iron movie you would have seen where Surya gives Tamanna one product if you buy another product free, right? Now that type of transaction will happen only with whom? Outside normal course of business, giving extra discounts. Clear? Giving heavy discounts, unusual discounts you are giving. Clear? In such cases, we will not be entertaining them. Ask what it is. Then any transactions with RP, it has to be authorized and approved. For smaller organization, this is waste, sir. Because you tell me, in any general store, have you seen a system? No. Murugan stores. If you go there, the owner only is a manager. The owner only is a cleaner. The owner only is a labor. What RP you are talking about there? Will he have ICS and all? He will not have S of ICS. Correct? And we are still talking about internal control systems. For smaller entity, it is less formal or not even relevant. Documentation also will not be there. Therefore, the only possible methodology there to identify is by using observation and inspection. Now, sir, nature of RPT is always and always and always high risk. Always high risk. But if it is done in normal course of business, then there is no risk. What do you mean by normal course of business? Sir, for everyone I am selling at the same rate. Even for RP I am selling at the same rate. No problem. That means risk is not there. But in the following scenarios, it is always a high risk matter. Important question from the exam perspective. What are the following cases, sir? Complex transaction. What do you mean by complex transaction? Difficult to understand. Clear? Very difficult to understand. Imagine A Limited sells goods to B. B sells to C. C sells to D. D sells to C. Then C sells to B. Then they sell to A. Very difficult to understand who is selling to whom. At what price. Clear? So what will happen? Generally, management will think that if you are entering into a complex transactions, no, CA will ignore that. Therefore, we will enter more and more complex transactions. Such things are not allowed. That's the reason in subsidiary company, they will not allow you to have more than 2 layers. Clear? So A can enter into with B, B can enter into with C. That's it. C cannot have D, D cannot have E, E cannot have F. Clear? Thanks to Mr. Ketan Parekh, scam of 2002. Clear? So after this only these type of changes have been happened. Then IS may be ineffective in identifying. Very good. Your information system is very weak. It's a nice opportunity to commit fraud. If it is not detecting, it is nice. No? Clear? Very simple, sir. If the fingerprint is not working, you can easily get away with it. You can always tell, I came that day, fingerprint was not working, what can I do? You did not come that day. You can still claim the attendance, which means your IS was weak. Okay? RPT did not happen under normal market terms. Imagine you appointed an employee, market rate is 20 lakhs per annum, you are paying 30 lakhs per annum. Why would you do that? Why would you do that? Now we need to see what type of person is that guy. What if he is a director's son only? RPT. Possibility is there. So if it is not under normal market terms, we be more cautious because it is a high risk transaction. Now tell me, if risk is high, procedures will be high. If procedures are high, evidence will be more or less? More. Therefore, I require more evidence. Therefore, sufficiency will increase. Got it? Okay. How do I verify the existence, sir? How do I know who is a relative? Who should tell? Go and ask the management, who are your RP? Sir, if framework requires, no, management will have a list. But what if framework doesn't require? Will management have a list? No. If law forces you, you will maintain a list. If law is not forcing you, will you maintain a list? No, sir. Imagine, simple example. Imagine, for timetable, you should put up a timetable. What all chapters you have studied on a daily basis. If ICA says, if you maintain timetable, I will give you 10 marks in the exam. Won't you maintain? Oh, yes, sir. Morning till night, we will sit properly plan and we will do proper planning, sir. Why? 10 marks we are getting. Now, because law is asking you to do it, you are doing it. But if law was not there to ask you that, will you do it? No, sir. Absolutely not. Clear? That is the reason why if law asks, management might have a list. If framework does not require, management will not have a list. Hey, not having the list does not mean they will not have relations. They will have relation. So they will be aware about relationships. They may not have a list. Go and ask about that relation. You know that relation. Go and ask, do you have significant influence in some other entity? Then they will think, yes sir, A limit is there. Then transaction between you and A limit is RP. Does someone have influence in your entity? Yes sir, B limit is there. Therefore, transaction between you and B is RPT. So ask management about the relations rather than the name. Clear? Understood? This way, we will get to know if there is any common control. Focus on sharing resources. This is an important concept. Focus on the concept first. What do you mean by government company? Government holds more than 51% of shares. Total voting power. Otherwise, control. Select chappal or shoe. Loose tools. More than 51% of total share capital, right? That too paid up capital. Okay. If the government company has, or if the company has given shares with differential voting rights, then total voting power. Otherwise, total paid up capital only. Clear? Explanation was given for those who attended law. Okay. Now the question here is, when a government company holds, or when a government is holding stake in government company, sir, a central government can hold multiple companies because layers are not applicable for government companies. Government company can have multiple layers. My question to you, If central government holds, let's say, A Limited, and A Limited is holding B Limited, right? Now, this is a one way of subsidiary. There is another way of subsidiary. CG is holding three companies, let's say A, B, C. Now, technically, A and B is RP, B and C RP, A and C also is RP. The question here is, how can we be RP, sir? Imagine this is coal company, this is petrol company, and this is, let's say, garment company. What relation they have? But still they will be called as RP because there is a common owner called central government. But it will have no logic at all. It will have zero logic because standard says if there is a common control, no, don't focus on the relation. Focus on, are they sharing resources with each other? If they are sharing resources with each other, only then they will be called as RP. Just because there is a common control, it doesn't become RP in such cases. Clear? For example, imagine there is one particular set of parents, they have adopted a kid. Okay, and after adopting the kid, they have a kid now. There are two kids. Now, the two kids who are brothers, they are not RP just because parents are same, unless they share a bond. Unless they share resources to each other, only then we can call them as RP. Just because control is common, it doesn't become RP. Because the one who has money keep on taking control. That doesn't mean automatically these will become RP. This can be proven as a very good question in the exam of SA 550. If they say that control is common, don't focus on relation alone. Focus on what? Sharing resources with each other at a significant level. If they are not sharing resources with each other, even though it is a common control or common management or common ownership, we will not be calling them as RP. Understood? Specifically for government companies, these are. Other companies, why will you form a relationship if you're not sharing resources? Clear? For government companies, they can keep on acquiring multiple companies. Therefore, this particular point can prove a very good point. Okay, that is your SA 550 RP. Now, 500 done, 501, 505 and 510 and 550 is also done, no? Okay, let's talk about 520 and 530. AC is not working or what? Right, SA 520 talks about analytical procedures. Now, when we talk about analytical procedures, this standard is easy, okay, very less frequently asked standard, but can be asked in MCQ as a part of it case. Analytical procedure, focus on analytical part. Analytical means what? Analysis, checking, verifying and comparing, then taking decisions on that. So for analyzing, don't you think we require more than 1 year data? Or 1 year data is good enough? In 1 year data, what can you analyze? So we require more than 1 year data. So whenever we want to do analytical procedure, basically here, we are trying to establish a relationship between two data, financial and non-financial data. So what is our objective of SA 520? Same, to obtain what? A, to obtain audit evidence. Second objective is to use this particular evidence in forming overall conclusion. For example, if I give you current year data and previous year data, you will be able to draw the difference between 2 years amount, and then you can take decision based on that. What is this particular, let's say, current year sales and previous year sales? Will you be able to decide whether it is increase or decrease? Yes. Based on that, can you ask more and more questions? Yes. Clear? So basically, analytical procedure involves the comparison or use of evaluation technique. Okay. What are the other objectives I have? Evaluate reasonableness. For example, current year, let's say sales is 10 crore. Previous year sales is 1 crore. What is the increase? 9 crore is increase. Percentage of increase? 9 divided by, not 9, correct. 9 divided by 1 into 100. How much will that be? 900 percentage you are increasing. Is it reasonable? Definitely not. Something is definitely wrong. Clear? Now this, only when I compare I get to know. If I had never had the previous year data, I would never be able to compare and tell whether it is right or wrong, reasonable or unreasonable. So my third objective is to evaluate reasonableness. Fourth objective, to make comparison between intra-firm and inter-firm. What do you mean by intra-firm? Within the organization in multiple departments I can verify. Inter-firm means what? Me versus competitors. Okay. Then next objective is to find the reasons for variance in the P&L items. It could be amount variance or ratios variance. Sir, debt equity ratio, this year it is 10, last year it was 2. What does that mean? Debt equity ratio this year 10, last year 2. What does that mean? Debt has gone up drastically. Clear? So last time what? Debt was twice the equity. Now debt is 10 times the equity, which means the risk is high. Therefore now the ratio also I can check whether the ratio is more or less. According to that I can start my audit. The best part about SA 520 is you can use this at planning stage also. You can use this in testing stage also. At the completion stage also you can use. It is your choice. Wherever you want you can use it. It is very flexible. Clear? Now how, sir? In planning stage it will give you an idea which one to do first. Which expense I should test first or which income I should test first. Now, what are the techniques are available for SA 520? 4 techniques are there. One is trend analysis, which is a commonly used technique. What do you mean by trend analysis? Upward trend, sideward trend, clear? No trend at all, that also can be taken into consideration. So trend will tell us where we are going to move next year or next quarter or whatever it is. It is comparison of current period data with prior period data to know the trend. Compare 2 data to know the trend. Second is what? Ratio analysis, which is entire chapter in your FM, which you have studied. Around 45 formulas is what I have heard. Correct or not? So many formulas are there. For what? For what? To compare only. Why are we having all those ratios? Interpretation point, that is clear. It is useful for analyzing income and expense or asset or liability. Intra-firm and inter-firm comparison can be done through ratio analysis. If somebody's debtor turnover ratio, what do you mean by debtor turnover ratio? FM? Tell me. Okay, easy question I will ask. Sir, debtor days. What do you mean by debtor days? Collection period. If the days are more, good or bad? If the days are less, good or bad? Good. Correct or not? Now, these things, if I sit and compare, I will get to know over a period how the company has improved or how the entity has improved. Clear? Let's say, for example, 5 years ago it was 120 days. Now it has come down to 12 days. Good? Yes, because we are collecting the debtors as soon as possible, which means our cash flow will improve. If our cash flow improves, our debt can be reduced. If our debt can be reduced, interest is reduced. Profits are increased. Dividend payment can be made. You see, only one thing we got to know, debtor days. From debtor days, we started analyzing till tax payment and dividend also. Clear? So, in ratio analysis, it will help us better to analyze multiple data. Reasonableness test. This does not depend on financial alone. This also depends on non-financial. Basically, More often than not, it depends on the circumstance. For example, sir, now we are doing marathon, correct? From morning 8:30 we are doing till 5:30. Okay. Now imagine a regular class every day, 8:30 to 5:30. Will you sit? Yes, sir, because of pressure. If exam pressure was not there, will you sit? No, that time no, sir. You have to give break every 1 hour. For every 1 hour break, for every 1 hour of class, give 1.5 hour break. Won't come only. Correct or not? Yes, live online we will sit and watch, or recordings we will sit and watch after exams. Clear? Right? Now the question is, if it is regular class, it is unreasonable for you. But if it is marathon, don't want break, sir. Continue. Right? Now that means in the circumstances you are changing your colors. Correct or not? Yes. Now intermediate student and final student. Final student, when we say we want a break, why, sir? Don't take break. It's okay if you don't. Regular class only they will tell, don't want break. You know how much is the demand for break? 5 minutes. Literally they say. Initially I was not used to give break anytime because 3.5 hours is a class. But then, sir, 5 minutes break maximum enough. And in that 5 minutes, nothing. They'll keep the book cassette, sleep. After 5 minutes, they'll get up. Continue, sir. Inter student, if I ask how much break you want, minimum 45 minutes, sir. For what? 30 minutes scrolling the reels, 15 minutes breakfast. Clear? Now that is what they want. Right? Circumstances. Exam when it is coming, no. Then you will tell, sir, please conduct marathon faster. Morning, now see Rashid sir has 7:30 to 7:30. Fine. Students, no problem, sir. But if it is a regular class, problem, sir. Help at ArivuPro. Now faculty should raise a ticket. Help at ArivuPro. The circumstances when this come, no, reasonableness will change. Clear? Now if you remember, long back, onions rate was different. Yes? Now 30 rupees per kilo, but when there was a very less supply, it went up to I think 110, 120 rupees per kilo. Was it reasonable? Of course, yes, that time it was. Now it is not reasonable. Clear? That is what reasonableness does not depend on financial data. It depends on non-financial data. Checks reasonableness of amounts of balances, whether it is reasonable or not, whether whatever you have paid is reasonable or not, depends on non-financial data. Fourth one, structural modeling. What is structural modeling? Very technical part. Clear? Very technical part where we use statistical techniques like what? Regression models. Like, sir, generally for forecasting, no. Next to 5 years, how will be our sales? Next to 5 years, how will be our profits? For all these things, they generally use either a trend they will use or statistical techniques they will use. But statistical techniques gives you more accurate information compared to trend or any other techniques. So for forecasting, generally these are the things that is used. Okay, you can go and see stock price, clear, profits, growth, sales for all those next to 5 years, next to 10 years and all. They can use these methodologies. What are the factors influencing, sir, for analytical procedure? Number one, if I have to analyze, there should be some data. Clear? If a student comes and say, sir, whether I'm studying properly or not, okay, tell me how much you're studying. That I can't tell you, sir. Without that only you tell me whether I'm studying properly or not. You don't give me data, what the hell I will analyze? Clear? Number one. Number two, disaggregation. What is disaggregation? What is segregation? Disaggregation and segregation is both are separation only. What is aggregation? Summing up, grouping. Disaggregation is division. So the more disaggregation is there, better the analysis. Meaning what? More information when you give me, my analysis will be better. Okay. Account type. Generally, analytical procedure is more suitable for P&L item rather than balance sheet. So does that mean balance sheet we can't compare at all? We can, but more effective is for P&L. Why? P&L entire year transactions will be there. balance sheet is nothing but one day balance will be there. So more detailing we can do with P&L items rather than balance sheet. Source. Non-routine transactions and significant transaction involves management judgment. Here what will you analyze? What does non-routine means? Unusual, unexpected transaction. How can we analyze that? Clear? We will not be able to analyze this because it involves management judgment. So their analytical procedure will not be useful for you. Predictability, it means those transactions that are reasonably expected to exist and continue. Only those transactions we can analyze where we are expecting two features, existence also, continuance also. Example, this year lottery income you have, next year you can't expect that because it is a non-routine, number one. Number two, it doesn't continue. Whereas rent expense exists also, continues also. Repairs and maintenance exists also, continues also. Whereas sir, let's say other income, and in other income now I have to see what type of other income is existing as well as continue. Only that I can analyze. Off item I cannot analyze. Prior period item I cannot sit and analyze. Extraordinary items I cannot sit and analyze. Clear? Next, nature of assertions. Analytical procedure gives more evidence for assertions like valuation and completeness rather than disclosure or rights, because those where amounts are there, no, there I can compare. But where explanations are there, very difficult to sit and compare. Last time we gave so much explanation, this time now we are giving less explanation. I can't compare that. But amount wise, growth or reduction in the amount we can analyze. Inherent risk, very good feature. This is what can go wrong, will help you in designing the procedures. Now for this only I want you to think, I know right now you will not get it, but think about it. In chapter 2 when we put audit plan, we will consider analytical procedure also there. Clear? We will consider AP as a part of planning. Why? Because we will have a mindset that what can go wrong. When we think about what can go wrong, no, our approach will be much better. We'll start thinking more about it. We'll start testing more about it. Therefore, here we need to have an approach called what can go wrong. It will help in designing my audit procedures. I am not saying what will, what can. So assume what all can go wrong. That will help you in designing the procedures better. More we can dig into the transactions. Now, using analytical procedure as substantive test. First of all, out of that 4 techniques, determine the suitability. What do you mean by determining the suitability? Which technique is more suitable? Number 1. Number 2. Sir, let me ask a question before I move on to the next point. Determining suitability means we know that reasonableness should have non-financial data. Clear? If it is forecasting, structural modeling is better. If it is a forecast, can I use reasonableness test? I repeat my question. For reasonableness test, we require non-financial data. If it is a forecast, structural modeling is much better because we are using mathematics and statistics there. Now, the client wants to use reasonableness test, or the CA wants to use reasonableness test to evaluate the forecast. Is it valid or should he select structural modeling? Which technique he should select for forecasting? Which one? Both can be done. Yes. Now he says both. Someone will tell only one. Someone will tell put all, sir. Whose father what goes? Clear? Now that is totally whose call now? Exactly my point. Clear? So you guys are thinking, let somebody answer. I think I will also think about the same. It's not that. Whatever you are thinking is right for you. Clear? Now that is the reason they are telling it is auditor's call to use the suitable analytical procedure. You want, you use reasonableness test. Otherwise you use statistical modeling. For example, you want to cook. Which is the method you want to use? Statistical technique or reasonableness technique? If we are cooking, reasonableness, no, statistical. If mother is cooking, reasonableness. Because if you are cooking, everything has to be measurement. Here, this much should be there, this much rice, this much water. Your mother multitasking. She'll listen to songs also, she'll talk on the call also, and everything measurement is her hand only, no. So for her it is reasonableness test. You start cooking 200 grams of rice. Clear? 400 ml of water for rice. Now such measurement you take, your mom will not see the measurement. Her measurement is reasonableness and unusual measurement. Right? So what technique is applicable? It is whose call? CA's call. Then, sir, I told you without the data can I analyze? Without data can I analyze? I cannot analyze. So for analysis I require data. So evaluate the reliability of data. What's the evaluate? Source of data. From where this data has come. Do you want me to waste my time? Do you want me to waste my time? No. Therefore, I require the right type of data. Clear? So if you are giving the data, give me proper data. Only then I can analyze. Number one. Number two, data should be comparable. If you are giving me a data which I can't compare, then there is no point of analyzing. Clear? Third, nature and relevance. What type of data you are giving? Are you giving relevant data? Only when you are giving relevant data, I can compare. Controls over preparation of data. Tell me now, if ICS is very good while preparing the data, can I trust that data? But if ICS is very bad, can I trust that data? No. So if controls over preparation of data is also important. Third, develop and evaluate the expectation. Now you need to develop the expectation. For example, if I say this particular topic will be asked in this exam, am I not developing an expectation? If I say this question will come, this topic will be asked, this formula will be asked, isn't it developing an expectation? Now how am I developing that expectation? Through experience. Clear? Now for that I can train you, provided you have to first have division of data. Like I said, you say experience. Experience means what? More number of years I have worked, more number of papers I have seen, more number of questions I have seen, which means I have collection of data. Clear? So I keep the more division of data I have, my expectation will be sharper and accurate. Clear? So you give me more data, I will tell you what can happen. Last 10 years data when you give, I can tell you, okay, in these attempts these I have asked, so these are the areas where they can ask more and more questions. So the more data I have, degree of division is called disaggregation. The more you divide, better the analysis. Availability of information. If information only is not available, what expectation I will have from where? Not possible. Accuracy of prediction of expected results. How accurately you can predict the results, that also develops your expectation. Everything comes from experience, lot of data and lot of analysis. Understood? Clear? Like how some people will tell, see, you see this guy, he will not clear exams. You see this guy, he will definitely score a rank. How some people are able to tell that? Not random expectation it is. They would have observed their patterns. They would have observed their test marks. They would have observed their language. They would have observed their friend circle. So much of data will be there with them to analyze and tell how accurately you are going to predict the data. Understood? That exactly is what we call as developing an expectation. Randomly, no one will develop an expectation. When somebody comes and says that this is important, can be asked in the exam. No. First we should see how is he telling. If he has good amount of data with him, then data speaks. Clear? Data absolutely speaks. Right? Now, that is what we consider with respect to developing expectation. Randomly, you can't develop expectation. Based on data only, you have to develop expectation. Finally, once you develop an expectation, now you are evaluating the results with actual results. Clear? You developed expectation, now you evaluate with results. Results is nothing but the outcome of actual scenario. Okay? If results are inconsistent with the information, that means inquire the management and obtain evidence for their response. Imagine you gave me the data. Now it happens generally with students. Okay? During mentorship it happens. So what we do is during mentorship we sit with the student, get to know each and everything about the. It's like personal training in gym. Clear? Every small things also we observe and we try to improve on that. Now imagine now when the student comes and gives all the data and we observe all the data, we develop an expectation that this student will definitely score exemption. Clear? Now that's an expectation we developed based on a lot of data. Now actually imagine the student doesn't score exemption. Now we will ask, no, why? What happened? Because no sir, I had confidence, but in exam I went blank. Now if you're telling that, that means you have given a response. As an auditor, I should obtain evidence for that response. Number one. Number two, perform other procedures which is appropriate. Now we can't do anything. You couldn't write the exam properly. We'll perform other procedures in the next attempt. So we'll train on how not to go blank now. Are you getting my point? So such things is what we call as, we have an expectation. With that, when we match the actual results, we won't be surprised because we developed that expectation. Clear? Last attempt it happened to couple of students. Clear? Both students had studied for both groups, right? Did not clear both groups, so they came for mentorship. So both are best friends. So I told one person you'll be writing one group, another person another group. So you'll be writing group 2, you'll be writing group 1. Both were puzzled. And both were like, sir, we were studying together and you're telling group 1. And I said, no questioning. You will write group 1, you'll write group 2, that's it. Otherwise, go away. They went, they wrote. One person wrote group 1, one person wrote group 2. Both cleared in September, respective groups. Now, the person who wrote group 1 is preparing for group 2. The person who wrote group 2 is preparing for group 1. The first question they came and met me in Chennai and asked, how? Tulil Dharmam. We can't tell that. It's a secret recipe. Why? That much of analysis goes into the advice. So when we consult, when we give advice, when we tell, do this, do that, no, it is not randomly we go home, we stand, we'll stand and we'll tell, problem is there here. That is not how we say. Understood? A lot of data will be given to us, right? That data we will analyze. We will see what are pros, what are the cons and etc. And then we will tell. Then there is an outcome. Now we compare with the outcome. When we are comparing with the outcome, no, that student was not even confident of clearing group 1, ended up scoring exemption in law with a 9% result. Clear? And when the student came and told, sir, I did not believe only, I am not surprised. Because according to the data that you have given to me, if you are doing these things right, you have to reach a process. So when that expectation and the actual result, when I compared, there was no much of a difference. Clear? So I was not surprised. But if there is a much of a difference now here, now we'll have to bridge that gap. That bridging of gap is what we call as performing other procedures which is appropriate in the scenario. Clear? This is how analytical procedures are done. AP cannot be done without the data. Remember that. Without the data, no way you can analyze. Even reasonableness, that one question I can ask you in the exam. Reasonableness, true or false, okay, for 2 marks if I ask you, now there is no point of true or false. Reasonableness test totally does not require data since it depends on non-financial data. True or false? I repeat, reasonableness test does not require data since it depends on non-financial data. What is the reason? Non-financial data also is a data only, no? So pick one. There is no, out of these 4, no, there is no technique which will work without the data. Trend requires data, ratio requires data, reasonableness requires data, structural modeling definitely requires data because it's based on formula. Clear? Therefore, as per SA 520, main crux is what? Data. Availability of data. Clear? That's an SA 520. Let's talk about the next essay. We'll talk the important one. Essay 610. AC is still not working, no? Working, AC is working, SA 610 using the work of internal auditor. Important. Very, very important. On this, no, one classic question was asked. Super question was asked, case-based question. Here, in that particular attempt, I think I have given you there in your book only, question number 82, I think, no? Which attempt it was asked? Jan 25, I think. Jan 25, no? Jan 25, one of the super question which was asked on SA 610. My recommendation, please go and solve that. Because that question is a question where it is not copy-paste question from the book. It is a puzzle. You have to pick up 3-4 points from multiple areas and then stitch one answer and write. Clear? So solve that question right after you revise this particular standard. SA 610 which talks about using the work of another auditor. But here it is not called another auditor. It is called internal auditor. There are 3 standards very similar. 600 we have, 610 we have, 620 we have. 600 talks about another auditor. 610 talks about internal auditor. 620 talks about auditors, but this is not there for you. Clear? For you only, this is there, that too very restricted, and this is there entirely. Okay, 610. This is new addition for the syllabus. Newcomer, let's welcome him. There are 2 types of auditors we have, internal and external. Now, when we talk about internal and external, imagine internal is a younger brother, external is the older brother. For parents, that is the users, who is more responsible? Elder one. Now, whatever younger one does, who is responsible? Elder one. So, ultimately, who is responsible? Now, for actions of younger one, elder one is responsible. For the actions of elder one is responsible. Same logic here. For the actions of IA, EA is responsible. For the actions of EA only is responsible. Therefore, the responsibility of EA is more than responsibility of IA. Number 1. This is a very basic concept you have to remember in SA 610. EA's responsibility is much higher than IA's responsibility because whose report is given to users? EA's. Is IA report given to user? No way. Clear? IA's report is always given to management and EA's report is always given to users. So in that scenario, what we should see, both will have to work and report. Even this will also have work and report. The only difference is my reporting is to users and your reporting is to management. Therefore, who is unbiased? EA or IA? EA is more unbiased. Why? Independence is there. Can IA decide whatever he wants? No, sir. He cannot because he is appointed by the management. So number 1. Number 2, can I consider IA as competent person? By checking? Now that is the point. That is the point. Sir, in case of section number 138 of a company, not all companies can appoint internal auditor. First of all, only applicable companies can appoint internal auditor. Number 1, listed company. Number 2, unlisted public companies. Number 3, private companies. Unlisted public companies having turnover, loan, paid up capital, deposit of 200 crore, 100 crore, 50 crore, 25 crore. Private company, 200 crore of turnover, loan of 100 crore. If you cross this or if you touch this, you will have to appoint an internal auditor. But crux is not this. Crux is who can be IA. CA can be an IA. CS can be an IA. CMA can be an IA. Any person can be an IA. Now, when you're appointing any person as IA, does he has competence? No. He will not have competence every time. So, what they will do, we first have to see whether his work is enough for us or not. Whether he has enough objectivity, whether he has enough competence, does he have an approach? If he doesn't have these things, no, my job increases because only I have to work now. Understood? If the younger brother doesn't understand what I am telling, if the younger brother doesn't understand what I want, there is no point of having a younger brother. But I can't do anything. Clear? I can't do anything because who wants younger brother? Management wants. Management has appointed the younger brother. My job is anyway not going to be easy. Clear? Now I am telling him, hey, go switch off the gas and come. Okay. Now what did he do? He switched on the gas and came. My work will increase. Yes, I told him, hey, close the door and come. Clear? He went, banged the door, door broke. My work will increase. So if he doesn't have competence to understand, clear? Now I told him, hey, go fill that water bucket for me. This fellow opened the tap and came. Didn't close and lit tank empty. Entire tank is empty. Now who's responsible for it? Management will come and shout at who? Elder brother, what did you do? Now that fellow didn't understand the logic only. Competence is not there. Approach is not there. Waste fellow. How can I use your work? Clear? Now in that case, that means my work will increase. And next time will I tell younger brother something? No. Definitely I will not tell. Same logic here. If IA is not having objectivity, competence, approach, I will not use their work. Now this standard deals with that only. As external auditor, should you use their work or not? Number one. Number two, there are three ways to use their work. Number one is by using the information. What do you mean by information? See, IA is there and IAF is there. IAF is internal audit function, which is nothing but internal audit department. Okay. Now, when the entire department is corrupted, can I use their work? No. Their work will always be biased. But whatever information they have, raw material, can I use that raw material? Yes. Because keeping this raw material only, they had finished their work. So can I use their RM and I can work on that? Yes. But there is another way. Why, sir, raw material? If IF is very good, I can use their work only, you know. Sir, what work they do? So much you are depending on them. What work you do? See, I need to be present at physical inventory counting. Now I can't be there. IA will be there. So whatever work I am doing, he is doing. Physical verification of assets should be done. I am not there. He has done. Can I use the same report? Yes. Clear. Internal control system verification I have to do, but he has done. Can I use the same report? Yes. Provided he has objectivity, competence and approach. Clear. So either I can use their information or I can use their own work or I can use them only. I can use them by telling, Tambi, you come to my team. Clear? I know management has appointed you. You work really well, but I don't trust your work because your department is corrupted. Do one thing, you come and play for my team. So that is called using them as a direct assistant. You come and help me. I will direct you. I will tell you what to do. You come and work. There are three ways, I repeat. One is using information, one is using work, and one is using themselves only. That is the IA. Come and work in my team. But SA 610 targets only two things. Three ways to use the work, but we are targeting only two. One is work and one is IA. In this entire standard, I'll tell you, if you see Institute Material Standard for SA 610, you will have no clue what they are talking and where what information is being conveyed. Everything is given like that. Clear? For that, try to understand where what object is spoken. Clear? Three things will be talking in SA 610, but two things will be discussed in detail. Three things is what? Information, work, direct assistance. But discussion will be only for work and direct assistance. Okay. Now, see the standard. Both will work and report. Okay. But internal auditor will be working where? In a department called IAF. So, first I should evaluate IAF. If IAF is good, then only I can use their work. If IAF is not good, then I cannot use their work. So let's first discuss with respect to IAF. What should I evaluate? Three things. Like I said, objectivity, competence and approach. If you are having these three things, if these are present only, I will go ahead. If these are not present, I cannot use the work. Why? Because I cannot rely on your information. What do you mean by objectivity, sir? What is objectivity? Not to compromise on the judgment. Now I'll ask you one question. You were appointed by management. ArivuPro management appointed you. Now you got to know that ArivuPro did a fraud. Okay? You got to know ArivuPro did a fraud. Will you report that? Will you report that? Now don't tell me I have to. Will you is a question. Why not? Huh? We can use, you can use it as leverage. The more leverage you use, even you will be a conspirator to the fraud now. So if they are going down, even you will be going with them. Huh? No, practically I'm telling. Not theoretically. Clear? If something you have against them and you forgot to tell within 2 days, you're supposed to tell within 2 days. Correct? So obviously now you are also a party to the fraud. Co-conspirator. Yes, the logic here is you will now depends on your competence. If you are saying, so what if you have appointed me? You have appointed me for work only, no? You have done, I am going to report. Now, if you are such a person where you don't care about that particular thing and you still go and report, crazy objectivity you have. But if you tell, I will report, sir, to the management only. Clear? And not to the government. I'll only go and tell the management. Sir, you have done fraud. See what can be done little here and there. If you can able to do a little more. Sorry, what? Correct. Yes. Right. Objectivity. Organizational status we have to check. Sir, organizational status means, does the organization help you in doing fraud or not? If the organization, if the department, see, now Lakshman might be very, very honest guy. Okay? Integrity, next level, epitome of integrity. But what is the point if the department is corrupt? If the department is corrupt, what can one individual do in the department? Nothing. Even he will become corrupt. Yes. See, I'm sure when he would have started the journey of CA, he had integrity. Now when I asked him the question, he's like, I use it as a leverage. Right? So obviously when the department is wrong, when the circle is also affecting you, if you are there in that circle, it will affect you. So first I should judge not you. I should judge your circle, the organizational status. Will they encourage you to become independent or not? But if, imagine now ArivuPro says, tomorrow if I have done fraud also, you should tell. That means organizational status supports objectivity. Clear? They support objectivity. So even if I have done wrong, you report it. That type of organization, if it is there, no, then others will automatically improve. Then supervision of TCWG. If TCWG overseeing is not there, then obviously people in the department will do whatever they want. I can't trust their work. Constraints placed. What all constraints placed by the organization to them? You can't do this, you can't do that. That means you're putting me in a cage. Clear? Then conflicting responsibilities. Very good, sir. To Lakshman only I have given audit also, books of account also. Super. He will only handle everything. Clear? That time, management will come and tell, Nalla Pandano ilyo. Understood? So definitely what they will tell, whether I am taking care or not, you are definitely taking care of my organization. And organization for you is only you. Clear? So such type of department, if it is there, no, then objectivity will not be good. If objectivity is not there, I don't want to depend on your work. Next is competence level. What is competence level means? How good you are with your work. Okay. Number one, I should check. First of all, whether department is as per the size of the entity and operations. If the entity is very big, department has only 2 people. Clear? Now in one of the cases, one of my friend told, I won't be able to come today because I'm going for team lunch. Now he said team lunch, no, okay, fine, go. After that we saw his story. Clear? 2 people had put up a story. Okay. I asked, bro, you said team lunch. Where is the team? He's like, we are the team. I'm like, huh? Yeah, in our team only 2 people, me and my manager. I'm like, for this is called team lunch or what? Now tell me, for this such a huge department, you have only 2 people. Pressure will be more or less? More. Workload will be more or less? More. Now in that particular thing, you have to appoint a right type of people. If you are not appointing right type of people, I can't trust their work. Policies for hiring, training and assigning work we should check. Do they have adequate technical training? Imagine you go and talk to internal auditor. Imagine I go and tell, did you do a physical verification as per SA 501? And I'll be like, sir, yes, I have heard. The SA new thing I am hearing. Very good. Technical training only you don't have and have to depend on your work. Understood? Clear? Then, do you have required knowledge? So, if these things are there, that means your competence level will be little higher. So, I can trust your work. Then, do you have an approach? Systematic and disciplined approach. Now, what do I mean by systematic and disciplined approach? Documented approach, sir. Everything, whatever he has done, he writes and keeps it. That's a very nice approach because now I can actually only believe what he has written. Clear? Like how you say, I have studied, sir. Where is the proof that you have studied? Clear? So when you document and keep, no, there is exactly a proof. Your credibility automatically increases. Appropriate quality control policy and procedure he follows. Clear? Like for example, RP he will not talk about, right? Now if he is following an approach which is good, then absolutely no problem to take such people into the team. Absolutely I will use his work. So 3 things I should check: objectivity, competence and approach. Clear? If these are not present, straight away say no, your job is done here. If these are present, only then I will be using his work. And how am I supposed to use his work? Step number 1, check relevance with strategy and plan. Why? Logic. IA also, imagine now IA is a CA. Okay, I am also CA, Lakshman also is a CA of a company. Now, both are technically sound. Both have knowledge. My question to you, he also knows that before starting the audit, there should be strategy and plan. I also know before starting, I should have strategy and plan. You tell me, his strategy and my strategy, will it be same? No. His plan and my plan will it be same? No. So first of all, I should check. He will be doing audit according to his strategy and plan. I will be doing an audit according to my strategy and plan. So if it is not matching, then there is no way of using his work. Sir, should it match 100%? No. We just said, is it relevant? If it is relevant, they never said accurately matching. If it is relevant, then I will be using his work. Clear? Number 1. Number 2. Now, in ICA material, directly they have given these 3 points. What I would suggest is, in the exam when they ask, no, my step number 1 is not point number A. My step number 1 is this, checking the relevance. If his work is not relevant to my strategy, then I will not use his work at all. Imagine, always my professional strategy was every group 1 exemption. Okay, that was my strategy which has worked in all professional levels for me. Now my question to you, except 1 professional level, everywhere I've got exemption in every level. Now that is my strategy. If I'm putting a strategy, don't you think my notes should support that exemption strategy? Yes. Now imagine my strategy is, in law I will take exemption, which means imagine even he is preparing for an exam, but his strategy is I will take exemption in accounts. Now where will his notes be more? Accounts. My notes will be more in
law. So his notes in law will be less. Can I use his notes for my strategy? I cannot. But if strategy is on the same page, then I can use his work which is relevant for my strategy. So step number 1, always check whether strategy is relevant or not. Step number 2, discuss the use of. I should go to him and tell, just like how in branch audit, I had told the branch auditor, if you are using I told Hari, no, if you are using your chart book, please give it to me. I will use it in my marathon. So I should tell this guy who branch auditor there in SA 600, advise OA of his work. Here I am not advising, here I am discussing. What is the logic here? There I am advising because before starting only I will tell him. Here who appoints IA? Management. So he would have already worked. So I will go to Lakshman and discuss how he has put up the procedure. But if that is okay, what is the next step, sir? I discussed how will I verify that? Access the report of IAF and get to know what procedures he has performed. So he will tell, sir, in this place I put TOD, in this place I put TOC. He gave a insight on that. How will I get to know more details about it? By accessing the internal auditor's report. And in that report, I will have to go and specifically read about what type of procedure you have performed. Point number C, perform sufficient procedure on IAF for adequacy of EAF. So I will sit and read that report and then take a decision whether that fellow's report is good enough for my work or not. You know why? Because if his work is very good for my work, no, my work will reduce. But if his work is not good, my work will. To decide whether I should work more or work less, I should go and first read his report. Imagine you finished all the work, then you read his report. If you could have substituted it, no, it would have been much easier. So first and foremost, I will go and discuss with him, check what procedures he has put, then take a decision whether it is adequate for me or not. Understood? Clear? Okay. Now, there are some areas where I should use Lakshman's work less, my work more. So areas where work of IAF is used less and perform more of EA's work. Which areas, sir? 4 areas. If more judgment is involved in planning and performing AP and judgment is involved in evaluating AE, you tell me his judgment and my judgment will be same. Therefore, wherever judgment area is there, I will use my work more, his work less. Wherever judgment is required very less, there I can use his work. Clear? But where judgment is more, I would rather use my work than his work. Okay? ROMM assessment is high or risk identified is significant. Any area where risk is high, whose work I should use more? Why? Again, risk is subjective. What is risky for me may not be risky for him, and what is risky for him may not be risky for me. Clear? So we need to understand if risk is high, it is better you use your mind. He doesn't have objectivity or he doesn't have competence level. Meaning what? In this case, no, read it very properly. I said when he doesn't have objectivity, he has, but is very less. He has competence, but very low. So I will not use his work. You know why? If he doesn't have objectivity or competence, no, it comes here. He doesn't have this. If these are not present, I cannot use. Therefore, here it is there, but it is less. Clear? He knows, but not in depth. In such cases, he has done the work. I am not blaming him, but his work is not useful for me. I require something more. Understood? Clear? Right. Now, this is the first scenario where I am using the work of IAF. Now, second way is using Lakshman in my team. I will tell him, you don't work in the management now. Let management only give you the salary and all. But till audit gets over, you'll be working with me now. I will tell you how to work. Because I like the way he has worked. But I can't trust that work because department is not good. Clear? So basically, the bunch of tomatoes there, not good. But only one tomato is very good. I need that person in my team because he knows the entity more than my team knows. Because internal auditor always stays in the entity 365 days. So he knows ICS better. He knows management better. He knows sales better. He knows purchases better. Every department that fellow knows. What is better for me? Come and play in my team then. Clear? I will tell you how to, what information I want. So, using IA as what? Direct assistance. Ensure there is no prohibition from using. Meaning, law should not prohibit you. If law says you can't work for EA, then I cannot use Lakshman. My job ends here. So, first of all, check whether there is any prohibition or not. Second, evaluate objectivity and independence and competence of him. Does he have objectivity? Not the department. Does he has objectivity? Does he have competence and does he have independence? Clear? Sir, even after leaving the department, he is working for our team, but he is working for management. Do we want him in my team now? Whatever is happening here, he will go and tell. Clear? Now, do we want him in my team? No. Clear? Black sheep. Therefore, I need to take care of that. So, first, before appointing him into my team, I should evaluate three things about him. Objectivity, independence and before using the work, first take his autograph. Where in written agreement. So, from two people, I'll take autograph. One from the management side and one from IA only. Management side, what they should write and give? They will follow. That is, management is saying IA will follow your instructions, sir. Clear? Like how in Jailer Shivraj Kumar tells us, sniper guys, from today onwards, you will be listening to him. I am not your boss. Give it in writing. Clear? Give it in writing. Number two, I will take from IA only in writing that whatever I tell you, you better keep things confidential with you. Number one. Number two, if management comes and gives you threats, first come and tell me. Clear? So, inform about threats to objectivity to EA. These two things you should write and give. Signed agreement. Clear? Management, what will I take? That he will work for me. He will follow my instructions and management will not intervene in my work. So, from IA, what I will take? Confidential matters, whatever I am telling, I am sharing, you will keep it safe. And number two, threats about objectivity. Okay. Next, sir, now we decided to use him in my team. They say, do not use at all if these two things are not there. What is that? There are significant threats to objectivity or he lacks competence. Sir, you only evaluated, no? Correct. I evaluated based on his work. Now, when I took him in the team, in my team, our expectation is little different. He is not matching with the expectation of the team. That's why we can't use him as a direct assistant. You go back to your team, no problem. Number one. Number two, he is good, but he has a significant threats to objectivity. Now, imagine, I took him in my team. Management kept on giving me threats, saying, I will dismiss you from the work. I will reduce your salary, this, that and all. Now, after some days, no, my question to you, do you want his work to be gone because of me? No. So, what we can say is, okay, pa, you go and work with them only, no problem for me. But technically, no, this is actually a good ploy. In those days, you would have given some information to me. Yes or no? In those days, wherever he has worked, he would have given some information to me. I can use that information as a leverage now.
So I thought we both get together and we put leverage on.
You can that also, but who is paying you salary? Management. I have one more way to do it. I will tell Lakshman, resign. Resign. Now, how much salary they are giving you? 50,000. No, I'll give you 60,000 rupees. Resign. Resign, and right away next day only I will appoint you in my office. Now work for my team. Now you are no more an IA. You are an EA with an information of IA. Now you leverage. Right? So we can think of that act also where I can use him, but here I'm not talking about those things here. Okay? Here what? Books normally we are using, he is working for management only, but assisting us, helping us, not working for us ultimately. After the work gets over, he'll be going back to the management only. Got it? Clear? So basically, I am like the Rajinikanth using Vijay Sethupathi in my particular aspect of PETA, if you remember. Clear? So I want my objective to reach. For that I am using his assistance. Understood? Yes, sir. That is point number A and point number B. There are some areas where I can't use his work at all, even if he is my team. Clear? Strictly do not use only for the following. In other areas you use. Which area is this? Wherever judgments are involved. Same logic. Because his judgment will be different, mine will be different. Areas where risk is high. Areas where judgments are required, especially in what? Performing procedures and evaluating evidence. Areas where work of IA is involved. Sir, his work I am giving him only to evaluate. You tell me, will he say true? Whatever truth is there, will he come and tell me? Definitely not. Clear? If he is thinking of leveraging, what all he can hide now? Yes? So definitely I don't want to use him in the area where his work is involved. And I will not use him in the decisions with respect to IAF. Because at the end of the day, it is his house we are discussing with. Clear? So the decisions with respect to IAF and use of their work, we will not be using IA. Logically, we should not use also because he might influence our decision. That is why for taking decision whether IAF's work we should use or not, it is better we exclude Lakshman in the discussion. So 4 areas we should never include IA. Number 1, judgment. Number 2, risk. Number 3, where he is involved, and number 4, IAF decision. Okay, right. Then this is just SA 610. In SA 610, only 3 things you have to study: evaluation of IAF, using the work of IAF, using IA as direct. Only 3 topics are there in SA 610, excluding the definition of internal control and internal audit.
If a company already has internal audit,
Okay.
will EA go and audit the ICS?
Okay.
Will he go on?
Yes, because you may have an IA. Now, unless I trust IA, if IA has already checked ICS, which is his actual responsibility, if he has already checked the ICS and I trust his objectivity, competence and knowledge, I can use the same report. But if I don't trust him, then I should go and evaluate. Very simple. Okay. Yes. Any doubts in this? SA 610, 3 topics. Number 1, evaluating IAF. Number 2, using the work of IAF. Number 3, using IA only as direct assistance. I will go to the work and assistance only if IAF is good. If IAF does not have 3 things, what is that? Objectivity, competence and approach, I will stop my work right there and I will do only my work. But if he has objectivity, competence and approach, then I will decide whether I should use a work or whether I should use him. If his work has, if I am using the work and the work is not matching with my strategy, then I will not use. If it is matching with the strategy, then I will discuss with him, read his report and then take a call. Clear? In which areas I am not supposed to use his work? Areas where judgment is there, risk is high and competence is less, objectivity is less. Remember, don't write objectivity is not there here. It is a lack or less. Whereas, when will I use IA as direct assistance? No prohibition of law. He has OCI, what is that? Objectivity, competence and independence, and his autograph. 2 people I should get autograph from, 1 management representative and 1 IA. Management representative should give what? That he will work for you, I will not interfere. He should tell what? I will keep matters confidential and any threats are there, I will come and tell you. Right? If he doesn't, if he has a significant threat to objectivity or he lacks competence, I will not use him. And in which areas I will never use him? Same logic. Judgment, risk, his work, his department's work. Got it? Yes. This is your essay 610. Very important standard. Clear? Very, very good standard also to ask questions for in the exams. Clear? Right, sir. Next standard is essay 530. We'll take a break. Yeah. So let's do bank audit now. In bank audit, very easy topic. If they ask you, good scoring topic this is, okay. Generally, it's not a very consistent topic. I'll tell you why. Chapter 9 and chapter 10. That is your audit of different and bank audit. Put together, they give a weightage. Okay. Now these two put together is what is the weightage generally, because these two chapters are what we call as special audits. So these are not general audits, these are called as special audits. Now this is where you have to understand both put together is what the weightage is. In ICA, they only have suggested that we are giving weightage based on these two chapters. So around 15% also if you are expecting, no. Chapter 9 gives you a better weightage than chapter 10 alone. Reason, the amount of studies you do for bank audit versus the amount of studies you do for chapter 9, that is more worth it. Clear? And if you actually see your chapter 2, which gives you planning, strategy, planning and programming, that gives you 10 marks. This does not even give you 10 marks the way you have to study. So I'll tell you where you have to focus on. Study, focus more on advances point of view. Clear? Even your revenue and expenses here, no, very less they have asked. Advances is where you have to focus. Majority part of bank audit is. Now bank audit here, whatever I have given is just for your revision purposes. The more concentration should be there on advances side. Because 4 marks if they want to ask, no, advances is what they will prefer. These and all is very easy and not even required in the exam for them to test. Types of bank, commercial, RRB and all. Directly come to advances first. Let's finish off the important part of it. Yes, advances. Types of advances let's talk about. One is called as funded loans and one is called as non-funded loans. Now, in case of bank audit, as an auditor, we have to go to the bank and check. Bank audit is a special audit unlike our normal audits. Reason, bank's accounting system will be different. Bank's internal control system will be different, right? Bank's transaction will be different. The volume of transaction of the bank also is very, very huge. So therefore, it will take at least a good 1 month if you sit there to understand their system. Clear? It will take so much of time for you to understand the entire system. Plus branches are in lakhs. Clear? So compared to the normal, banks, if you normal entities, banks have a little more complication to understand. Clear? Now SBI alone has around 23,000 branches across India. No, I think 22,000 something Indian branches. Then they have domestic or overseas branch. Clear? Now imagine so many branches if you sit and do audit alone. Possible? No way only. Therefore, in bank, you will have two types of auditors. One is called SBA. That is statutory branch auditor, and then you have SCA, statutory central auditors. Clear? They call it as CSA also. Basically nothing but central statutory auditor. Both means the same. So here we'll be talking generally with respect to the bank, and everywhere whatever we are talking, more content is from central auditor's point of view, not from branch auditor's point of view. Okay, right. Advances are of two types. One is funded and one is non-funded. What is funded? Money is given to you, you spend it. That is called funded. Non-funded, money is not given to you, facility is given to you. Like for example, guarantee. Clear? In case of guarantee, you are getting the facility, but money you are not getting. Okay. Now, classification sector-wise is there. That is, RBI will tell you which is priority sector and which is non-priority sector. Security-wise, primary security is there, collateral security is there. Right? What are the type of security creations here? One is called mortgage. What is mortgage? Generally, mortgage is for immovable property. So mortgage are of several kinds, but the most important are registered and equitable. What is the difference? Registered will generally be on the written format, that is documentation. It will be registered in the government records. Equitable mortgage will have an agreement, but will not go to the registrar's office and register that particular agreement. Pledge involves bailment, your Indian Contract Act, but pledge is specifically for loan. In case if you have taken loan, gold loan is a classic example of pledge. You give the ornaments and you take money. Hypothecation means here equitable charge. You will enter into an agreement with the bank called hypothecation agreement, and where possession is not given to them, ownership also is not given to them, but you are like the agent of the bank. So you will be using it, but for your purpose only. Example, car loan. Clear? Car loan, vehicle loan, right? In case of even housing loan, you will enter into an hypothecation agreement, or it can be even a mortgage deed you will enter into, where you take loan from them, You will not, nowadays you will not even give the second key to the bank. They are principal, you are the agent. In the agreement only they will write that in case if you make default, they can take the seizure of those goods or your vehicle. Clear? Next is assignment. What does assignment means? Transferring the right. Example, Lakshman has to pay me 1 lakh rupees and I have to pay bank 1 lakh rupees. I can tell the bank, collect the money from Lakshman. So my right, I am assigning it to the bank. That's called assignment. Transfer of an existing or future debt, right or property belonging to a person in favor of another person. Only actionable claims will be considered as your assignment purpose. One is called book debts and one is called life insurance policy. Okay. Then set off. What is set off? Bank owes you something, you owe bank something. Both will not pay each other, and that's how set off is happening. Example, FD loan. When you take loan on FD, you owe something to the bank, bank owes something to you. You don't pay, they don't pay you. That is called set off. Lien means what? Legal charge with the consent of the owner. This is what you have to see in the exam, with the consent of the owner. So I am taking the consent of the owner and then I am giving it to them. Meaning whatever, like for example, books or gold loan, I can take it. Now you have given, with the consent only you have given. If you don't make the payment, no, I will keep the gold with me. Clear? So I have taken the legal charge of it with the consent of the owner, which gives lender a right to seize or dispose or liquidate the asset under lien. Now here is where important things start. Now, whenever we talk about the loans, there are two types of loans, standard loans and NPA loans. Under standard, we have regular loan and CMA loans. What does CMA loans means? SMA, which talks about what? Special mention account. Now, special mention account is nothing but slowly these people are going to, the regular means good boy. Yeah, regular means good boy. SMA is slowly going towards bad boy. NPA is a very bad boy. Clear? So they're slowly going to that where overdue is there. Now, even if you're overdue for 1 day, we will call you as SMA 0. If you cross 30 days, we call you SMA 1. If you cross 90 days, we'll call you no. If you cross 60 days, we call you SMA 2. Remember, SMA 0, 0 to 30 days. SMA 1, 31 to 60 days. SMA 2, 61 to 90 days. Then, in case of NPA, we call you as under NPA. See, NPA is a building. Remember that way. Visualize. NPA is a building. Clear? Under that building, we have rooms. Clear? First room is substandard asset. Then you go to doubtful. Then you go to loss. Clear? So, a good loan can become a bad loan. Clear? Standard loan is good. NPA is bad. Under NPA, we have three types: substandard, doubtful, and loss. Under doubtful, we have three: D1, D2, and D3. Clear? Now, what is that and all? We'll see a little later. Now, when does an asset become NPA? Clear? Number one, when you ceases to generate the income for the bank. What do you mean by ceases to generate income for the bank? What is the income for the bank? Interest or EMI principal, getting my principal back. Clear? Revenue is interest. So when they say ceases to generate income for the bank, we call it as NPA, depending upon the type of loan. If it is a term loan, if I don't get my interest or installment of principal for more than 90 days, we call you NPA. For which loan it is? Term loan. For CC or OD loan, if you are an out of order loan, for you, we will call it as NPA. Remember, terminologies are very important. Clear? For term loan, EMI, if you don't pay, or even interest part of EMI you don't pay, we call you NPA. In case of OD or CC, if you remain out of order, we call you NPA. In case of bills purchased and discounted. Bills purchased and discounted. If the bill remains overdue for a period for more than 90 days, then we call you as NPA. So there are three ways to call you as NPA, three different loans. These are not only loans, we have more. Term loan, what do we call? EMI. fully not paid, interest not paid, principal not paid. For how many days? Don't say 90. More than 9 days. Number one. Number two, ODCC out of order. Then bills purchased and discounted more than 9 days. Classification of NPAs based on record of recovery. Meaning what? Only if we recover, we call you PA. We don't recover, we call you NPA. Very important point. Sir, in this case, even we don't care whether you are rich or poor, whether you have given security or not, whether security value is more than loan or not. Did you pay? No. If you don't pay, we call you NPA. You can't come and tell you have my security and all. No. Boss, did I receive my money? Did I receive my money is a question. No. Security is there. Did I receive my money? No. You don't pay my money, we call you NPA. Clear? So, availability of security or net worth of borrower or guarantor is not to be taken into account for purpose of treating an advance as NPA or otherwise. So, I will not be bothering about your NPA if security is there, net worth is there, I don't care. Did you pay? That's the question. You don't pay, we don't call you anything. Clear? I mean, you don't pay, we call you NPA. We don't care about whether you have given security or not. Asset classification is borrower wise and not facility wise. If a person has 4 loans in the bank account and 1 loan becomes NPA, entire portfolio is NPA because it is borrower wise and not facility wise. Imagine I have housing loan, vehicle loan, term loan. Term loan I made default. Term loan is NPA, housing loan NPA, vehicle loan NPA. Even though I am paying to properly. Because NPA is classified what wise? Borrower wise and not facility wise. Next, out of order. What do I mean by out of order? Because this is very, very important for CC or OD, that is cash credit or overdraft. Now, when do we call you as out of order? Outstanding balance remains continuously in excess of sanctioned limit or drawing power. We have something called as sanctioned limit. We have something called as DP. Clear? Based on your credibility, based on your asset worth and all, we give you a ceiling limit. Clear? Now, outstanding amount is more than that. Imagine sanction limit is 10 lakh, outstanding limit is 12 lakh. We call you as out of order. First scenario. Second scenario, if outstanding balance is less than sanction limit, but there are no credits continuously for 90 days as on the date of balance sheet. Meaning what? Sir, sanction limit is 10 lakh, outstanding limit is 8 lakh. Still less only, no? Outstanding limit is lesser than sanction limit, but you have not made a single payment in the last 90 days. We call you out of order. Third way of calling you out of order. You have made a payment, but the payment is not at all covering interest debited in the account. Whenever in case of loan, no, there is interest part and principal part you are supposed to pay. Let's say interest part is 10,000, principal part is 6,000. You have made payment only up to 3,000. This 3,000 is not even covering interest. We call you out of order. So number one, outstanding limit is more than sanction limit, out of order. Outstanding limit less than sanction limit, but no payment, out of order. Payment made, interest is not covered, out of order. Then accounts regularized near the balance sheet date. Sir, near 31st March only, till now it was NPA. But just before the financial year ended, what did this person do? Made the payment and converted that into PA. Now here you have to be a little careful. What is it? The asset classification of borrower accounts where solitary or few credits are recorded before the balance sheet should be handled with care and without scope for subjectivity. Meaning, if it is a genuine case, consider as PA. But you know this fellow has no chance of repayment. Summa just before the 31st March, this fellow regularized near the balance sheet date. Then you call him as a deemed NPA even though he has made the payment. Remember, I am not saying always it will be a deemed NPA. If it is a genuine case, then yes. Imagine he was completely lost. February, he got his business back. He made the payment. He became PA. Good, no problem. But this fellow is a jobless guy only. Just before March, he converted his NPA into PA. That's why they say, if the account indicates a weakness, then call it NPA. If it doesn't indicate weakness, then don't call it NPA. Next, government guaranteed advances. Now, what do you mean by government guaranteed advances? Let's say, for example, government came up with a scheme that for all entrepreneurs, up to 10 lakhs loan will be given from the bank side. No security. You just have to give your Aadhaar and business details. Will give you a loan of 10 lakhs. Now, government is the security for that. You are not giving any asset as security. So, government will give you security. E-Mudra loan, this, that and all is there. No, Mudra loan now, if you see MSME loan and all, bank will give you. On whose guarantee? Government's guarantee. Now, the question is, who is giving the guarantee? Is SG, state government, giving the guarantee or CG giving the guarantee? If SG is giving the guarantee, no problem, default rule. If SG does not pay more than 90 days, we call it NPA for both. Income recognition purpose also NPA, asset provisioning also NPA. Why it is required, sir? Remember this rule. Remember this rule. Asset classification and income recognition. If asset classification is NPA, income should be recognized on cash basis. If asset classification is PA, income should be recognized on accrual basis. Clear? So the moment you become NPA, I will stop recognizing the income and therefore I will recognize on what basis? Cash basis. Now the question is, if state government has given a guarantee, law says or RBI says, if state government has not paid for more than 90 days, consider them as NPA for both. That means now record on cash basis as and when government is giving you money. But if it is a central government guarantee, what does guarantee here means? Let's say this is a bank, this is you want loan, bank is not giving. Now, because of government, there is government here. Government tells bank, hey, I am giving you guarantee, give loan to Karthik. Now, technically, I should repay this in 2 years, for example. Okay, 2 years tenure loan. Every month I should pay EMI. I didn't pay. Clear? The moment I did not pay for more than 90 days, government should pay. Yes or no? What does guarantee means? When he does not pay, I will pay. Yes or no? When the debtor does not pay, surety will pay. Now, Karthik sir did not pay for more than 9 days. Technically, who should pay? Government should pay. But if it is a state government, no. The moment I cross 90 days, even though state government guarantee is there, it will be called as NPA. That is for whom? State government. But if it is central government, no. RBI says the asset considered as PA. Asset considered as PA, do not create any provision. Clear? But for income recognition purpose, treat it as NPA. Therefore, record on cash basis. Clear? For asset purpose, PA, don't create any provision. For income purpose, NPA, as and when they pay only, you record as income. True and fair. Understood? Okay. Next. In case of consortium advance, what do you mean by consortium means? Group advances. Clear? When one person takes loan from multiple banks as a group, we call that as a consortium loan. Now, in that case, what happens? It is like joint audit for us. For auditors, it is joint audit. For bank, it is consortium. Everything will happen together. Joint appraisal, joint control, joint monitoring, etc. Usually, a bank with higher share will become lead banker. For example, Kingfisher. Clear? When they took Kingfisher, Gitanjali Gems, so many companies have taken joint loan under consortium. So, bank with higher share will become what? Lead banker. Everything will be made payment to lead banker. He is a leader now. Clear? So, all the payments will be made to lead banker. Lead banker should distribute it to the whom? Participant banks. Now, imagine SBI is the lead bank. Karthik sir will make payment to SBI. SBI should distribute it to the participant banks. But very peculiar feature here is, sir, where the remittance by the borrower are pooled with one bank and the bank receiving that remittance is not sharing the EMI or their part with other member banks, the account should be treated as NPA in other banks. Clear? Why? Because NPA is based on record of recovery. If other banks don't receive their money, it will be treated as NPA in their books. For example, SBI received the money. He did not part with ICICI, Axis, nothing. In all other books, I am an NPA. In SBI books, I am a PA. Technically, it is bad. That is why to avoid this, what they will do, the participant banks will have an agreement with the lead bank. Clear? The moment you get the share, you have to share it with us. There should be an agreement. Otherwise, NPA is bad for them also. Why would they want NPA to be there? Clear? Right, sir. Drawing power, who will calculate? Again, the lead bank will calculate and allocate it to the other participant banks. The responsibility is more on whom? Lead bank. But what if mutually they want other banks to become a lead bank? Allowed as sir? Allowed, sir. Generally, share, whoever has the highest share, he will become the lead bank. But if you don't want that to happen, or if he doesn't want to take up the responsibility, mutually you guys agree who will become the leader. Then, accounts where there is erosion in the value of security, meaning reduction, gradual diminution in the value of security. And how are we supposed to classify that? Here there is no PA, NPA. Directly we will classify it as doubtful or loss. When will we classify it as doubtful, sir? If the value of security is when realizable value is less than 50% of assessed value by the bank. So, how much am I realizing in the market? That value you have. Compare that with 50% of assessed value. If RV is less than 50% of AV, classify it as doubtful and create provision according to doubtful debts. Understood? Clear? I repeat. When will we classify it as doubtful? When the realizable value of the asset is less than 50% of assessed value. And who should assess this value? Bank or RBI. Consider that as doubtful. But if realizable value is less than 10% of outstanding amount, consider that as loss. In case of loss, 100% provision we create. I repeat, if the realizable value is less than 10% of outstanding amount in the ledger, we call it as loss asset. Therefore, how much provision will make? 100% provision is what we'll be making. Clear? Then advances against term deposit, NSC, KVP, IVP, these all are investments. Clear? Against your investments, if I am giving loan, I need not consider them as NPA as long as there is adequate margin in the accounts. Example, if I have to give you a loan of 10 lakhs and you are telling, sir, I have FD, I will keep FD as a security. Now, I will tell you, I will give you a loan of 10 lakhs provided in the bank account. No, always you should maintain 5 lakhs margin. If I say that, all the time you have to maintain how much? 5 lakh margin. As long as that 5 lakh is there, I will not consider that as NPA. Margin will be decided by the respective banks. Okay. Then, in case of natural calamities, if the advances are affected, sir, what do we need to do? Banks only can decide their own relief measures, but RBI says, I will give you a master circular. Do not cross that master circular. Decide whatever you want, but don't go beyond master circular. In such case, NPA will be as per revised terms now, not as per the old terms. Because natural calamity, your entire crop is washed off. From where will you pay loan? So we will revise your terms and NPA will be as per revised terms. Now, advances to staff. If you have given advances to staff, there are two authority you will be having. One authority is as a banker you will be giving, and one authority is as a employer you are giving. As an employer, if you give, it need not be included in the normal heading called advances, including the other heading of other assets. Balance sheet presentation we are talking about. If you are giving as a banker, include as a part of advances portfolio. In the balance sheet, advances will be there. There you include. But if you are giving as an employer, it is not under advances, it is under other assets. Okay. Then one more case is there. In case of housing loan or similar advances, where the advances granted to staff members where interest is payable after recovery of principal. So this is one peculiar feature for bank employees alone. I will give you 1 crore loan today for 10% interest, but first to repay that 1 crore. Then you repay whatever is the interest. But interest will be calculated and kept every month. But payment will not be there every month. Payment when will you make? After you repay the principal. Clear? So if this is the case, then NPA will be for two different categories. NPA for principal separately you have to consider. NPA for interest separately you have to consider. I repeat. Let's say for example 1 CR loan is given in the year 2025. Let's say you will take 5 years to repay 1 CR. So till 2020 you will pay only what? Principal. But interest calculation will be made and kept because interest is based on outstanding principal. Yes. Now imagine from 2020, sorry, till 2030 year, 2031 you will be paying interest. So NPA for principal will be from 25 to 30. For NPA for interest will be from 2031 to whenever you are paying. Due dates will be different for two different principal amount and interest amount. Understood this one? Pakka. Can we go ahead? Okay. Agricultural advances. There are two types of agricultural advances. One is called long duration crops and one is called short duration crops. Now, what do you mean by long duration crops? Those crops where harvesting period is more than 1 year. And what is short duration crop? Less than 1 year. Clear? So, in case of these crops, how do we classify this as NPA? A loan granted for short duration crops will be treated as NPA if the installment of principal or interest remains overdue for 2 crop seasons, and loan granted for long duration crops will be treated as NPA if the installment is overdue for 1 crop season. Clear? Now, what do you mean by crop season? Period up to harvesting. Who will decide this? State level bankers committee in each state they will decide. Clear? Out of these 11, no, you can expect one question for 4 marks. Easily you can expect one question out of this. Then comes your drawing power, which is very important. Clear? These two only are very, very important from advances perspective compared to your other audit of expense, audit of other income. Other income is nothing but your rent and other things, which is generally for other entities. How do we audit? Same logic here. So more focus on advances and drawing power. Clear? So tomorrow we'll continue with drawing power and we'll finish it off tomorrow. So tomorrow we'll be finishing rest of our portions, how many ever is possible. So I'll be prioritizing only important weightage chapters. That is, I have to finish standards first. We'll be finishing your essay 5:30. Then risk assessment we'll have to finish. And then whatever is pending will be trying to do it tomorrow itself. Clear? Thank you.
Right, next topic is drawing power, computation of drawing power. Bank audit we were discussing. Now, drawing power generally will be given in case of working capital loans, that is overdraft or cash credit, which is common in case of bigger entities because due to funds being stuck in with the client's place, for example, generally happens when you have a project coming up and you have done the project and you have submitted the bill and I have not received my money. Now I need to take care of my daily expenses, salary, electricity bill, admin expenses, etc. For that I require funds, and that funds can be taken through your cash credit or overdraft limit. Now that is where drawing power comes into the picture. Drawing power and sanction limit are two different limits. Sanction limit is a maximum limit based on your credit worthiness. Drawing power keeps changing every month because drawing power is always given through current assets valuation. Clear? So what is the bank's duty here? They should ensure that the client, that is the borrower, has the adequate current assets. And here generally current assets we will take into consideration is debtor, that is receivables, and your inventory, or we say stock. So what we should see whether stock statement, quarterly returns, and any other statement given by them should be scrutinized in detail, check in detail, and in case of any annual report submitted, that should be an audited one. Monthly stock statement should be given. But there is one concern here: for every other borrower it is monthly. In case of large borrower, it is once in 3 months because they will be busy with their business and other things. So we have given them one compensation. Quarterly statement you give, it is good enough, once in 3 months. Now, stock audit is important. For who stock audit is important, sir? For any particular borrower where the funded exposure is more than 5 CR. Remember, funded and not about non-funded. We are talking about funded exposure should be for 5 CR and non-funded. What branch should do? Branch should obtain the stock audit report from the lead bank in case of consortium. In the normal one, we will appoint the auditor and he will take the audit report. Now let's try and understand the calculation of it. Now how do we calculate drawing power? Same problem we already solved in the class, right? Now how do we calculate drawing power? Stock minus creditors. Creditors got reduced because there could be some charge on that particular stock, so we do not want that risk. So formula is what? Stock minus creditors minus margin. Margin is also given in the question for you, but in real life every bank will have a different margin limit that they have set. Then we have book debts, but when we are considering book debts, consider only eligible book debts. Now what I mean by eligible book debts? Any book debts. Do not include any book debts which is for outstanding for more than 90 days, because it is very risky, so I don't want to take that risk on my head. Therefore, any book debts, if it is more than 90 days, we will ignore it, we will minus it from the gross. Now, then one question which was asked, same question they have asked in the 2025 also, same question, ditto question, no change also, no change in the amount also, same question they have asked. How is it calculated? Stock 50,000 minus creditors. What is creditors? 15,000. Now this is 35,000. Be careful, don't minus margin directly. First see stock or whatever is the amount minus creditors. 35,000 minus margin. What is the margin on stock? 20% they have told. Therefore, 7,000, not 7,500, 7,250. Huh? How much? 7,000, no? 35,000 into 20%, 3,500 into 2. 7,000. That will come to 28,000. Okay. Then we have debtors. Debtors is how much? 45,000 minus ineligible debtors 5,000. That is 40,000. And margin is 50%. Therefore, 20,000 we will reduce. Outcomes 20. And what is total? 48. But I can't do 48 because we have to see the ceiling limit also. What is the max limit allowed for you? Sanction limit is 45,000. So whatever we calculate comes beyond sanction limit. Therefore, maximum allowed will be 45,000. So after calculating, compare that with sanction limit. Whichever is lower is what we give. Like this, every month we will calculate and keep a record of it. Bank will have a register called TP register. In that register, every month they will note and keep how much is the limit that we have given to the borrower. Right. Now, audit of advances, what all we should see? We should see whether advances means which are outstanding as at the date of balance sheet. Advances means what? Amount due to the bank. So it is a receivable to the bank. Clear? Amounts due to the bank are appropriately supported by loan documents. That is the evidence for us. Audit evidence. Loan documentation should be there. Then, no unrecorded advances. No skipping of entries. No entries shall be skipped. Then, valuation should be checked properly and valuation principles should be applied properly. The advances are disclosed, classified and described as per accounting policies and practices. Like I said in the previous topic where we discussed with respect to staff loan given to the staff. If you have given as a banker, classification should be advances. If you have given as an employee under other assets, under others, you have to show. Appropriate provision should be made as per the RBI norms. Provisioning is very important. In the exam, they can ask you practical question on provisioning. What all document I should check, sir? Validity of a check, loan documentation you check, review the operation of accounts every now and then, whether it is actually PA or NPA, examining the existence, enforceability and valuation, meaning whatever security they have given to us, can I enforce it or is it null and void? Checking compliance with RBI norms. 99% of the time you have to comply with RBI norms. Appropriate analytical procedure SA 520 we have to apply here. Okay. Now this is important in carrying out substantive procedures. What are substantive procedures? Test of details. You should examine all large advances while others may be examined on sample basis. Large advances 100% checking, other advances sample based checking. Accounts identified to be a problem accounts, however, need to be examined in detail irrespective of the amount. Even if it is a very small amount, if it is a problematic account, check everything with respect to that. On these two, I can definitely trap you. Be careful in the exam. Okay. So when we are giving advances, what I should check with respect to internal control system. Very rare question, but can be asked for exams.
So what specifically I have to check? Credit worthiness I have to check. Whether what is credit worthiness? Tagdi, eligibility. Do you have that much ability to repay the amount or not? Clear? Execution of documents. So signature, all documents should be signed. This is one part where practically in the years that I have done bank audit, every year I have seen this particular point being missing. Clear? So many documents will be there where some of the documents are never ever signed. They will just put an X mark here and they will not sign. If there are two signatures which is required by RBI, they'll take only one signature and finish it off. Because they'll be like, sir, let's process the loan faster. Let's not sit with all these procedures and all. Many a times I have personally flagged as an auditor for this point. Clear? Then compliance with terms of sanction and end use of funds. Wherever you have taken money, you're using the funds also in the right manner. Sufficient margin must be kept. Now, who will decide the margin? Like I said, the bank only will decide, including the RBI's circular, meaning within the circular only margin will be decided. Control of security, meaning shares, debentures, when you're giving it, you have to transfer that in the name of the bank. Transfer in the sense not sell it, but give the right to the bank. Tomorrow, if you don't take any interest in repaying the loan, they can take those shares and own the ownership of the company. This is where we had seen in Caro, promoter pledging their shares and taking loan. So when you pledge your shares, debentures and take loan, it should be transferred in the name of the bank. All the registration, all the documents what is required should be registered in the name of the bank. Bank in case of jewelry loan, for example, jewelry loan, housing loan and all, inspection. They will do a lot of inspection before sanctioning the loan. What if you're giving a fake gold? Yes. DP register shall be maintained. Whatever drawing power you are giving or whatever amount you are giving, it should be kept within the drawing power as well as sanction limit. Any irregularity should be told to the controlling authority. Now, who is controlling authority? For the branch, whoever is the boss, regional office, zonal office, tell them. Clear? Review. Once in a year, at least you have to review. This is a very good point in the exam. In a case-based question, they can draft this. Okay. Audit of revenue items here, very simple. Revenue and expense, I am not even touching about it. What is the biggest revenue, biggest expense for a bank? Interest. Revenue also will be biggest, expense also will be biggest. So revenue, only one point I want you to understand, the materiality of the amount and RBI's direction. What do you mean by this time now? Very simple logic here. RBI says, sir, a bank can earn a lot of different types of revenue. You earn it. But how do we put it in the balance sheet, or how do we show it? How do we account for it? We have two bases. One is called accrual basis and one is called cash basis. Clear? Or non-accrual basis, any other basis. RBI says if any income is exceeding 1% of your total income, that income should be recorded on accrual basis. If it is not exceeding 1%, then all those income can be recorded on cash basis. Provided, if I am saying 1% of total income, that means you should recognize your income on gross basis. If you are recognizing income on net basis, then the criteria will be 1% of what? Net profit before taxes. Meaning, sir, first we have to ask the bank, how are you recording the income? Gross basis means what? Including the cost. Net basis means what? Excluding the cost. So, including the cost if you are recording, then for you criteria will be 1% of total income, or your gross income, meaning what? Gross basis is including cost. Imagine 100 rupees I earned. To earn this 100 rupees, I have spent 20 rupees. Now, gross basis means in the P&L, you will record 100 here, you will record 20 here. Whereas net basis means I will not record 100, directly I will record only 80. Now, we need to ask bank what methodology you are following. If you are following gross methodology, then for you criteria is check any income is exceeding 1% of your total income. If it is increasing 1% of total income, that particular income should be recorded on accrual basis. All other income should be recorded on cash basis. Like imagine interest. Now my total income is 100 rupees. Okay. My interest itself is 70 rupees. Now is it increasing more than, is it exceeding 1% of total income? My total income is 100. 1% of total income is 1. This is 70. So interest has to be calculated on or recorded on accrual basis. Any other income, if it is less than 1 rupee, should be recorded on cash basis. And that too, they have told 1% is a very meager amount. 1% of total income. Let's say now dividend I am earning only 0.5 rupees. In the entire year I have earned 0.5 rupees.
Now, is it less than 1% of total income? Yes. Therefore, the dividend has to be recorded on cash basis. Cash basis means as and when we receive and not as and when we earn. What is the difference between earn and receive? Earned is accrued. Received is? When we actually receive is what we call as receipt basis. Accrual means we finished our part. Clear? We finished our part. For example, now imagine let's say you are my client. Now 30th September is the due date. The 29th September I signed my audit report and I filed. My job is done. Imagine you're supposed to pay me 1 lakh rupees. 1 lakh rupee you might be paying to me in the month of December, but I earned that 1 lakh rupee in 29th September only. So earned is nothing but where my part I have finished. Clear? When I finish my part of the work, that means I have earned the money, but when you give the money, that is called receipt. Right? But here what we have to see, if it is more than 1%, then earned concept you take. If it is less than 1%, receipt concept you take. This is one very peculiar feature only in case of banks. Generally what we do in other cases, NPA or any other bad debts only we record on cash basis, everything else on accrual basis. Even 10 rupees that you are earning in normal accounting we record on accrual basis, but banks are little different. For banks, only if it is big income, then only you record on accrual basis. Small income record all on cash basis. Now, what we should do, we should not flag saying if they are recording on cash basis, no, don't put in the report that these are not following accrual system of accounting. Loose tools, they are following RBI system of accounting. Whatever RBI says only they have to follow, because in Companies Act, you know, section number 128, books of accounts have to be maintained on accrual basis, and here accrual basis is only not for all particular amount, it's only for 1 or 2 amount. Okay, right, sir. Then for all other things, advances, adequate margin should be maintained. Clear? Bills purchased. Now this is a good point. In case of bills purchased outstanding at the close of year, the discount receipt should be apportioned between 2 years. Example, February is the bill, right? Now some person who has bills receivable, some person, imagine I am the bank, okay, there are 2 people, Naveen and Lakshman. They both are entering into a credit transaction. Now Naveen has sold goods to Lakshman. Naveen is supposed to receive 1 lakh rupees, okay. Now 1 lakh rupee Lakshman is going to pay after 3 months. The transaction happened in the month of February, okay. That means February end it happened. 3 months is March, April, May. So Lakshman is going to pay at the end of May, right? Now the problem is Naveen wants money right away in the month of March. What he will do? He will come to me, right? He will discount that bill and get his money. Now 1 lakh rupee Naveen is supposed to get. I paid only 99,000 rupees. How much is my income now? 1,000 rupees. How much is his expense now? 1,000 rupees. Now the bill is with whom? Me, bank. Now I need to go to Lakshman in the month of May and get that particular amount. But the 1,000 that I earned on discounting doesn't belong to this year alone. It belongs to this year as well as next year. It is spread over 3 months. Therefore, what I should do? 1,000 into 1 by 3 this year, 1,000 into 2 by 3 next year. That is what we say, apportion properly between 2 years. Okay. Interest component paid by the bank or branch on rediscount of the bill should not be netted off. Now imagine, same example I will continue. March 1st, Naveen came and gave me that bill. March 10th, I want that particular money. Now I will go and rediscount it to some other bank. Now that some other bank charged me, let's say 800 rupees. How much I earned from Naveen? 1,000. How much I paid? 800. What is my profit? 200. But do not record 200. Record 1,000 separately, record 800 separately. Net off automatically will happen in the financial statement. So show 2 separate transactions. Reason being is, number 1, these both transactions are not happening with same person. Clear? Number 2, the date of transaction could be different. Clear? Now don't tell that, sir, what if the date is same? Still show 2 different. Hey, tell me one thing. One day you have made 100 sales. How many invoices you raise? Why not 1 invoice then? You can't net off like that. Clear? Every day you have made sales, every day you have made purchase. Why not net off and show days profit only then? Purchases separately will show, sales separately will show. Same logic here. Your income separately you show, expense separately you show, unless RBI asks you to net it off. RBI clearly says, do not net off, show differently. Bills for collection. What to do, sir? Sir, imagine
Navin's bill receivable. Clear? Now it is matured. In the month of May, Navin is very busy. So Navin will come and tell me, sir, you are my bank. No, can you please go and collect this bill from Lakshman? Now, in that bill, 1 lakh rupees is there. What should I do? Should I collect from Lakshman and then pay Navin, or should I pay Navin first and then go and collect it? Collect first from Lakshman and then give. Why? If I don't do that, no, I am only encouraging accommodation of the bill. In a bill of exchange, one concept was there, accommodation of bill, where bill is drawn without any transaction at all. Summa Navin will draw bill on Lakshman and Lakshman promise to pay, and Navin will come and give me the bill. If I pay Navin, no, tomorrow Lakshman says, I will not pay you, sir. Therefore, now I have already paid. Yes, my money who will give now? He is absconding, even he is absconding now. My money is gone. Therefore, first collect and then credit to the party. Don't credit first and then collect. Be careful with this concept. Renegotiation. In case of renegotiation, renewal, etc. Remember, if you have spoken with respect to agricultural advances due to natural calamities has been damaged, we reschedule the terms. When we reschedule the terms, renewal happens, extension happens. For that, processing fees they will charge. That processing fees is what they are telling. Take it based on over a period, spread it over a period of rescheduled terms. Clear? So processing fee, let's say for example, 1000 I charge for a loan over 5 years. So 1000 not in current year I should recognize. 200, 200, 200, 200, 200. 5 years, over a period of 5 years I have to spread, and basically it's like a amortization of intangible cost. Clear? Over a period of the asset is what you do here. Same logic here. Over a period of time covered by the renegotiated or rescheduled extension, you take it into consideration. Okay. Reversal of income, very simple. For this, only one thumb rule. For such a lengthy thing, no, only one thumb rule. What is that thumb rule? Remember this very carefully. There are two types of asset: performing asset and non-performing asset. Performing asset, we recognize the income on accrual as and when it is earned. So, in accrual, we don't really care whether we have received or not, but we record and keep it as our income. For example, imagine ArivuPro should give me my salary as and when I finish my classes. Now, imagine I finished my class as on March 20th. Okay, my March month ka salary, imagine they don't pay in the month of March, they'll pay in the month of April. Now, in my income tax return, should I show that income as income in the month of March or income in the month of April? Income in the month of March. But, if ArivuPro, if they are doing TDS for me, and if they do the TDS in the month of April, showing that this is April month's salary or April month's payment, then in my income tax I should show it as a income of next year only. Clear? Reason being is, there are two things. This generally happens because of two types of capacities. If you work as an employee, then no problem, it will be shown in the month of March only. But if you are working as a consultant, now when you are working as a consultant, in a month you can give consultancy to multiple people. Yes, now that means I am not working only for ArivuPro. My other consultancies will be there. Yes, now imagine I am giving consultancy to my client with respect to my practice. In the March month also I will raise a bill. Right. So I need to also see if ArivuPro is telling that this income belongs to March, but we are doing TDS in the month of April. Then for me it will be the previous financial year income only. Doesn't matter where you are doing the TDS. Clear? Because in TDS there is a rule. When you earned or when you are deducting, whichever is earlier is what you have to take. And when I earned is in the month of March. So they will tell Karthik sir earned this income in the month of March, but I am doing TDS in the month of April. Clear? And then I am making the payment to him. Clear? So 100 rupees if I have earned, 90 rupees will make the payment. Let's say 10% of TDS. Now, if they say in the month of April only he earned, and this month only I am releasing the TDS and making the payment, that means I should show in the next financial year based on accrual system. Clear? If it is based on receipt system, no. Even though I earn in the month of March, when should I make the payment? March only if I receive March month income, April if I receive April month income. Now, how is it relevant to bank? Now, there are two things. Two types of asset you have to see. One is performing asset and one is non-performing asset. For performing asset, always on accrual system. Non-performing asset, always on cash basis. Cash basis means always when it is received. Now, in case of banks, NPA has a process. It will first be regular, then it will become SMA, then it will become NPA. The moment it becomes NPA, you start creating provisions. But when you're creating provision, first of all, whichever amount you have earned, recorded but not received. I repeat, with respect to NPA, income which is earned, recorded but not received should be reversed. Income which is earned, recorded but received, don't reverse because it already received for you. But income which is earned, recorded but not received should be reversed. And when should I record that? As and when I earned or receive the money. Clear? Once from NPA it becomes to PA, then I come back to accrual again. Okay. So I keep shifting between accrual and cash as and when the status of the asset changes. NPA, simple logic. NPA is like bad debts. Clear? So bad debts is always recognized on cash basis. NPA also is always recognized on. But sir, there is one more concept here. Memorandum account. Memorandum account means nothing but where bankers say that, sir, one question we have, sir, you are saying that in case of NPA, interest that is earned, interest that is recorded but not received, you have to reverse. But imagine the borrower comes after like 15 years or 10 years and says, I will pay your money, sir, tell me how much. Now, if I don't have the account for it, how much I will tell him? I can't tell no like that. Therefore, RBI says you maintain a memorandum account, a rough book where all the interest of NPA will be recorded and kept. Recording you will still do, but not in the main books. We'll be doing it in the subsidiary books. But this subsidiary books are there, no, is not a part of your books of accounts. This is only and only for control purposes. Control purposes means we need to know how much interest we have lost in this account. Therefore, we'll maintain a separate account for that. Clear? That is memo account, memorandum account. Right. Expenses, which is the biggest expense for us? Interest. Now, with respect to that, check current year interest and last year interest. There is one concept which I have to highlight here. They call as weighted average interest rate. Now, what is this weighted average interest rate? Then they say calculate that first, then compare that rate with an actual average rate of interest paid. Now, what do you mean by that? What do you mean by that? Imagine a particular bank has 4 types of deposits. Deposit 1, deposit 2, deposit 3, deposit 4. Now, what is the principal amount of total deposit 1 you have received? Let's say 100 lakhs. Okay. D2 150 lakhs you have received. D3 35 lakhs you have received. And D4 500 lakhs you have received. Okay. Now, this is the principal amount. How much interest you have paid on these deposits? Let us say D1 you have paid 100 lakhs. No. Let us say 23 lakhs 45,000 you have paid. Here 15, not 15. 10 lakh 90,000 you have paid. Here 13 lakh 57,000 you have paid. And here 10% is 50. Let's say 75 lakhs 68,935 you have paid. Now tell me what is the total of this and what is the total of this? 600, 750, 750 plus 35, 785. Correct? This is 785, no? 500, 600, 750, 785. Correct. Here 935, 15, 15, 20, 8, 13, 13 plus 4, 17, 17 plus 9, 26, 2, 7, 10, 13, 8, 120. Okay. Now, 123, 60, 935 is the total interest paid on the total deposit of 785. Calculate weighted average. 123, 60, 935 divided by 785. How much?
0.15.
Into 100.
15.7.
15.75 is your weighted average interest rate. Now this you have calculated. This you have to compare with whatever banks have calculated. If they have calculated, let's say for example 15.77, somewhere it is absolutely close, so we can say okay, there's no much of a deviation.
But imagine your calculation comes as 15.75 and their calculation comes as 26.84. There's a difference now. That means either they would have missed out on some of the deposits to give you, or their calculation is wrong, or your calculation is wrong. Definitely something is wrong. Therefore, when we calculate and compare, this is called analytical procedures now. Clear? Whatever we did is called recomputation here. They have computed, but we are doing it again to check it out. Clear? That is your weighted average interest rate. Next. Check whether interest has been given on all deposit. The rate should be as per RBI. Now you cannot give at any rate what you want. So RBI's rate only have to consider. In case of inter-branch balances, provided the rates prescribed by the head office or RBI only. Basically, who is the father for all the banks? RBI. So their regulations only are supposed to follow. Clear? Nothing much to talk about here. One note is there. What is that? In case of banks, they have a different format. Format number B under schedule number 3 of Banking Regulation Act does not specifically provide for disclosure of prior period items. Meaning PPI specifically there is no disclosure, but if there is, you can give. But why is it given, sir? In other cases, no. Specifically PPI disclosure should be given in P&L. PPI one line item only is there. Whereas in case of banks, PPI line item itself is not there. Their format only is not giving you. But if you have a PPI item, you can disclose it. This is very important compared to other entities. Now comes the provisioning part, which generally under old syllabus they were not asking. Under new syllabus they'll ask, because under old syllabus you had one chapter called accounting for banking companies or financial statements of banking companies. They have removed that chapter from group 2 because in group 2 there was one paper called advanced accounting. Clear? In group 1 we had accounting. Now that advanced accounting had banking sector financial statements chapter. They have removed that. So provisioning used to be asked there. Now 100% chance of asking in audit paper. Clear? So how much provision? If you are a substandard asset, you have to create 15%. If you are a doubtful asset, if you are D1, then on the secured part 25%, unsecured part 100%. If you are a D2%, secured part 40%, unsecured part 100%. D3, secured part 100%, unsecured part 100%. Clear? Now, because of this, calculation will change. Now the question is, you will be asking, how do I calculate this? Very simple. In the question, imagine outstanding balance. Outstanding balance is 150 lakhs. Okay. And there is a security which is given from the borrower side of 100 lakhs. Now you will tell, why did the bank give 150 lakhs when the security is 100 lakhs? Loose tools. You should know outstanding balance consists of principal plus interest. So interest keeps on adding if you don't pay principal. So if principal is outstanding, interest will keep on adding. So because of that, including interest, the outstanding balance has gone to 150. Now I have to create provision for 150. How do I create provision for 150? First we will have to segregate into secured and unsecured part. How much is secured part? 100 lakhs, because the security covers up to 100 lakhs. Rest 50 lakhs is unsecured. Now let us say it is D1, 25% plus 100%. Therefore 25 lakhs and 50 lakhs total. So my provision will be for 75%. Whereas if it is D2, 40 plus 100, 40 lakhs plus 50 lakhs, provision will be 90 lakhs. Third one they say 100 and 100, 100 lakhs plus 50 lakhs, 150 lakhs. So basically if you see, as and when time is increasing, my provision also increasing because risk is increasing. Clear? Provision has to do a lot of things with risk and certainty. If certainty is there, then no need of provision. But RBI says, did I ask you for your opinion? Generally in other laws and other entities, no, you will create provision on your own. But in banks and NBFC, you can't create provision on your own. You have to create provision as per RBI. So RBI says, I did not ask you to use your brain. I have given you a percentage, blindly follow it. No sir, he will give. That I don't care. If he gives, reverse the provision. But if he does not give, I really don't care. You have to create a provision. Now because of that, don't worry. Nowadays you will be least bothered about creating provision because
core banking systems is there or core banking solution systems are there, automatically the system only will calculate provision and keep it. Because we all know bank managers can be manipulated. Clear? In those cases, they may not create provisions at all. And year end, when we do audit, we have to flag a lot of accounts for not creating provision. So to curb that, automatically system only will do everything. Okay, here they can ask loss asset 100% you have to create. Now, question is what is loss asset? See, loss asset means when we do audit or when RB goes for inspection or even concurrent audit, if they say, sir, this actually is loss asset, write it off. You have to technically write off. There are two ways to remove an account from the financial statements. One by creating 100% provision and one by writing it off. If you have never written off, despite telling it as a loss asset, you have to create 100% provision. In those cases, it will be removed. Nullification effect will be there in the financial statements. Okay. This is your audit of expenses. Let's move on to the next standard which we are yet to finish is called audit sampling. After this, we'll be talking about risk assessment chapter. Clear? Now, risk assessment chapter on the YouTube channel, entire regular class ka chapter will be uploaded. Clear? Later on, if you want, you can watch that as well. And after that, you can come for the, you can watch the revision video also. Right? Because risk assessment, generally students think of skipping that particular chapter because the chapter is pretty huge. Clear? That chapter is pretty huge because it is a combination of two chapters. Clear? And I know my students and I know CA students. Clear? They will do everything except chapter number 3. They are ready to do chapter number 5 also. Clear? But they say risk assessment is little too much. Clear? Yes, risk assessment is little too much, but it is more practical than ever. Okay? So in that aspect, that chapter has 2 parts. Clear? Technically, that chapter has 4 parts. If you study in 4 parts, no, that chapter will become easier for you. 4 part is 315 one part, 330 one part, clear, internal control one part, and automated environment one part. In automated environment, certain questions are there which is highly active questions. So those we will be doing it. Next, SA 530 talks about what? Audit sampling. In case of audit sampling, what are we supposed to do, sir? There is a population, but that population, from that population, I have to pick sample and perform test on that sample and give a reasoning for that. Now, to understand this, a couple of examples and then directly we'll move on to the main topic. So, imagine I have a population in front of me and I want to test that and give a conclusion. Now, imagine one class is given to me. This class is given to me and ArivuPro says, sir, tell me how is this class? Now, I should tell ArivuPro whether this class is good or class is bad, whether the IQ of the class is good or IQ of the class is bad. Why? I don't know if you are aware, in some of the institutes, clear, it could be coaching academy or college or school or anywhere, they segregate the class based on students' IQ. Clear? The high IQ students will have a separate class. Clear? Low IQ students will have a separate class. Why is that, sir? Result-oriented approach it is. Clear? So, high IQ students, when I merge them with low IQ students, so one of them will lose confidence. Clear? The low IQ students generally will lose confidence because when I have experienced it because in inter classes when I was a student, I was sitting in a classroom full of rank holders. Clear? So everywhere I shift, there were rank holders. AR1, AR10, and they don't believe in double digit rank at all. Clear? 3, 7, 9. Now, whenever I'm sitting with them, I used to feel a lot of insecurity and underconfident about the course. Clear? In the first 1 week only, I gave up on CA, telling I will not do it. Clear? First 1 week only. Forget about knowing the syllabus. Clear? Because I have a very good habit that my gut feeling is very strong. So I decided that based on my gut feeling, I will quit. Clear? But again, I was forced to not to quit and sit for a month. So I changed my batch from morning batch. I changed to evening batch. Evening batch more worse. Clear? Even though they didn't score rank last bench, I thought generally last bench people are not that focused in the class. So it's more about enjoyment and all because that's what happened in schools, colleges. I went and sat in last bench. Last bench also rank holders. Clear? Literally last bench rank holders we have. Now wherever I go, these worms are there in my system. Now how do I handle this? Now that's why in some of the systems what they did, we will segregate. Clear? In our college, we had a system where CA students and non-CA students together they'll do BCom. Clear? For a CA student, BCom is in sleep they will solve problems. For non-CA students, they have to sit and learn and practice and then go and write the exam. For us, it is left-hand work. Clear? We can finish that exam. Entire 4-5 semesters taxation is one paper of CA intermediate. Clear? So when you finish that, for you it is easy. Yes, that's the logic now. Now there our college decided that this is very bad because a lot of non-CA students are coming and complaining to the management that we are withdrawing our admission because in our class, when the problem is given by the faculty, students give the answer. Clear? We don't even, we used to not even sit and calculate, just calculator. Take the calculator, whatever he says, because tricks also we know. Clear? M plus, M minus, MRC, tricks also we know. Just with the calculator, we should tell total salary. Now they will use half an hour to solve the problem. 24 marks salary problem. Clear? And that salary problem used to finish like this. So these people then complain saying we are not able to understand what the teacher is teaching and is moving on to the next problem altogether. So what they did, they segregated the class. They said CA BCom 1, non-CA BCom 1. And accordingly, in CA BCom will send teachers who are supposed to be teacher in future. B.Ed and trainee and internships and all they just come to our class. They will not teach, we will not learn. Because we don't want to learn from them, they don't want to teach us. It was just a time pass for us. They'll come, give us attendance, we will sit, we will play dumb charades, we will say Pictionary, we will play all these things and we finish the BCom class. For them, they send these UGC level lecturers where they have to teach, number of hours they have to teach, etc. etc. So many criteria were there. So that is called segregation. There is a population which is a heterogeneous now. They converted that into a homogeneous population. Similarly, imagine if a doctor wants to test your entire body and give a report on that, now he will never take the entire population. He will never take that 5-6 liters of blood from your body. He'll take only 5 ml, 3 ml, 10 ml. He will test that and based on that he will give a report will be given. On that report he will give you the medical advice. Now that is also called as sampling. Clear? You go to a hotel, you go to a sweet shop, you go to Anandas, you go to anywhere, sweet shop you go and you just tell them, I want a sample of this. Now there will be 100 pieces of laddu there, but you eat only one small piece of laddu and you decide that this laddu is great and give me 1 kilo. That is also called as sampling only. Clear? Imagine now you want to take a very hot water bath in Kashmir. Now you fill the bucket with the water. Clear? Now you actually go, you just touch the surface level of the water and check how hot it is and then you conclude on the entire set of bucket. Sampling. Everywhere sampling is there. Clear? Same logic in financial statements we use. Debtors, 10,000 debtors are there. Everything we can go and check out. Now out of that we select only what? A few debtors for sampling purposes. We take that sample, we test them and then we give our opinion on that. So what is sampling technically, sir? Application of audit procedures to less than 100% of items in a population in such a way that all units have an equal chance of selection. Meaning, whenever you are selecting, do not be your class teacher of your school college. Why? She was always biased or he was always biased. You should never have bias when you are picking the units from the population. Randomly you should pick. Or based on features you should pick, but not having a bias. What is population? Entire set of data from which I pick units. And what is sampling units? Individual units together make up the population. Characteristics of population must be a car. C for completeness, include all relevant items. A for appropriateness, whatever population you're selecting should be as per your objective. Example, if I want proof with respect to credit sales, I have to choose debtors. I can't choose creditors. Clear? So proper as per your objective only select the population. Reliable. Like I already said, data if it is not reliable, analysis can go wrong. Therefore, data must be reliable. There are two approaches, statistical approach and non-statistical approach. What is the difference? Now, in one of the exam, there are advantages of statistical approach. Clear? For 5 marks. Easy questions these are. Statistical approach is more scientific, wide application and no personal bias. Samples are not prejudged, meaning what? We don't have a judgment of which sample we are going to take. What is the advantage? Testing does not increase in proportion to population. So what do you mean by that? Understand this example. There are 1,000 units already in the population. I want 10%. What is 10% of 1,000? 100. So 100 is a sample I want, 1000 is a population. Now when they say testing does not increase in proportion to population means what they are trying to tell is they are telling that, sir, imagine now 1000 items are there in the population, 100 is what I want. Now it's a homogeneous population. Now that 1000, I added 100 more units to the 1000. I added 100 more units to the 1000. What is the population size now? 1100. Now what is my sample size now? 100. How much should I increase to? How much? 110. That's a mistake. That is what is the mistake you guys make. Remember, if my initial population was 1000, initial sample size was 100. Now population increased by 100. Therefore, what is the total population? Now this also should increase, but it need not be 10. It can be even 2. It can be even 3. Clear? So my sample size can be 110 also, 102 also, 103 also. Because that is the advantage of statistical sampling. In statistical sampling, we take the sample not to keep the proportion same, to keep the features of the sample representative of population. So out of 100, imagine all have similar units. Why I should take more? I need not take more. I can take only a few out of that particular more. Understood? Clear? Imagine you went to a sweet shop, 100 pieces of laddu is there. Clear? You ate one piece of laddu and you decided already. Now they brought another 50 pieces of laddu and kept on that population. How much will you eat again now? Another half laddu will eat? No, sir, I already ate. That should be similar only. Clear? Therefore, no problem for me. For me, I am happy with this particular sample. It doesn't mean that if for 100 laddus, if I ate one, if they add 50, I should eat another half. That is not that's what I'm telling you. Don't try to match the proportion. Clear? And if you see here, testing does not increase in the proportion to population. So if population increases, that doesn't mean I should increase my sample size also. I can increase my sample size or keep it same. I can decrease my sample size as well. Understood? The proportion of increase will need not be the same. Don't fall for the trap that same proportion I should select. Clear? It is more objective and defensible, meaning what? Because it is a formula based, statistics based, mathematics based. It is more objective, meaning what? Unbiased opinion I can give, and more defensible. Why people are using this? Clear? People use those formulas and that's how I can defend myself. Sample is associated with specific risk and precision. High risk units only I take first. Clear? So it is more to do with how much is the risk and how much is the precision. Precision means what? Accuracy. Because of the formulas I can target. For example, let us say there are 6,000 listed companies. Let me execute it in front of you. Oh God. Let's see. Let me try and execute it. Yes. So this is how the companies look with the inputs that I have given. What is my input that I have given? Market cap should be more than 1 lakh. Sales growth, profit growth, net worth I removed, right? Then CAGR, compounded annual growth rate. Compounding, it should be growing, and these are the things. Now, since this is my own login, I have already given one basic query for all the companies that I am searching. I require net profit, variance, I require quarterly profit also should grow. ROCE should be more than 20%, that is return on capital employed, profit growth, PEG ratio. Then your EV by EBITDA, sales variance, profit variance, I want, and this is how I will get my company. If I want, no, I can in fact change the particular criteria that I want. If you see there are given price to earning, market cap, dividend yield, etc. Clear? If I want, I can add more here and I can get whatever I want here. So many things are there, right? Sales growth, profit growth, return on assets, EPS, debt, promoter holding, change in promoter holding. So many I have. You can't find your ratio, create a new ratio. Clear? So according to my ratio, I can give whatever I want and I can get my company's list. Clear? Now this I will save and keep there so that whenever next when I want to see which companies I want to invest in, I can get it through this. Clear? This is one of the ways of picking companies not for investment purpose, just to start off with which company I should study about. Clear? Randomly I will not study about random companies. So I'll sit, I'll take one company, now I'll read their annual report. Now I'll go and read about their news, about their article, who has told what is the chairman's statement which has made, recently quarterly financial statement results, what they have been telling, what is the market trend, what is market telling about them. Like that, at least 1 week I can spend on this particular company and then take a decision. This is the price that I want to enter in. If it comes at this price, I will enter. If it doesn't come at this, which generally will come. Clear? Because P ratio will keep fluctuating. It will come to a particular point. Now, how will I know, sir? Let us say, for example, I want to invest in Polycab Wires, okay, or Polycab India. Now, this is a good company which I have picked. ROC is more than 20, ROE is more than 20. Graham number is 1610, which will not match. Graham number means this is the proper valuation of the company based on the asset worth and all. Now, company's worth is 7,193 per share. Where is Graham number? 1610. Definitely it will not come to that low level. Clear? So ROC in the last 5 years 26%, ROE 20%, PEG ratio. Now what will I go? I'll see what is the valuation in the last 5 years. I'll go for PE ratio and I will see. See, this is perfect valuation now. How much is PE? 44. How much is their median PE? 44.1. That means in the last 5 years, this is a good valuation to enter into, and I will not purchase anywhere here at PE 63. I will purchase at PE. Now it is 44. Median is 44.1. I will not see how much is the share price. Clear? I will directly go and say, take that. Now out of 6,000 companies, 7,000, 10,000 companies, I am picking one company. On what basis I am picking? Statistical basis. Clear? And not non-statistical basis. Non-statistical means like how people bought Zomato first. Clear? Don't know what is Zomato? Don't know logic of that? Zomato you ever heard? Yes, buy. Paytm you ever heard? Yes, buy. Lenskart you ever heard? Yes, buy. Clear? So buying is not based on that. I don't really care whether it is 7,000 or 10,000. If the company is good, I will go for it. Rather than buying 10,000 shares of 1 rupee each, I'll buy one share of 10,000. For me, outflow is same, no. But Indians have a mindset that I should see many shares in my portfolio. Clear? Now, you see many shares in portfolio. The real investors want to see the price column of the portfolio. Clear? What if your 10,000 shares of 1 rupee each grew by only 1 rupee? Now, 10,000 will become 20,000 rupees. But what if my 10,000 share becomes another 15,000 rupees? So, that is what investors will see out of that. Now, this is also called a sampling only. From the population, I am picking based on statistics. Now, my girlfriend is not there in Polycab. Yes, my wife's relatives are not there in Polycab. My father, mother is not there in Polycab. So, this is nothing to do with my bias. Are you getting my point? So, in that case, we are not putting bias in that particular picking. That type of approach is what we call as statistical approach. But if you are putting knowledge and experience, then it is very difficult for you to tell there was no bias. And that you picking based on personal experience and knowledge is what we call as non-statistical approach. Very simple to operate. What is that? Forget about these formulas and all. He will straight away go and buy one stock. Why? My friend told, sir. If he is telling, it should be fine only. Clear? Now that is called as nonsense sampling. Clear? Non-statistical, but good way to tell is what? Non-statistical. Based on personal experience and knowledge. But yes, as an auditor, when we are doing sampling, your experience counts. Clear? Now here, some are good, some are bad. Now you tell me, which one should I select? Statistical or non-statistical? No. Professional judgment. Clear? That is the trap of audit. Audit will give you a very good feeling that this is very good method. That is not a good method. Which one I should select? Whichever you feel like. See, like how people say smoking is injurious to health. Still people smoke. It is there in the packet only. Yes, yes sir. We are just saying how much injurious. Clear? Right? Now, that is the logic, sir. We will give you two methods. Which one to select? You take a call, because at the end of the day, opinion is yours or mine. Your opinion. Clear? So we will tell you which methodology gives you what advantages, what disadvantages. Calculated risk you can take based on this. Now me investing in polycab is risky only, but I am taking a calculated risk. Understood? Clear? See, now I never planned on doing this. I got to know polycab is at good valuation. I was busy all this day, I couldn't see. Clear? Now I got one company. Now I'll sit and read about it. Clear? Proper valuation also I found. Right? Better description of large mass of data. Clear? And widely accepted way. Now, extent of checking of sample, meaning how much I should check. Clear? Number one, size of organization under audit. State of ICS. Now, size of organization under audit means if the organization size is a bigger company, then my sample size also will be bigger. More checking I have to do. State of ICS. If ICS is weak, more checking or less checking? More checking. If ICS status is very good, less checking. Adequacy and reliability of books and records. If whatever books and records are good enough for you, it is adequate also, I can trust that also. So I will check more or check less? Check more or check less? Check less, because I am trusting that particular books of accounts and records. But if reliability is not there and it is inadequate, my work will increase. Tolerable error range. In these questions, you have to listen to my question and answer. I want to tolerate more error. I want to tolerate more error. Will I check more or check less? Check less. Loose tools. That's why I said focus on the question. I want to tolerate more error. I will check less. I want to tolerate less error. I will check more. I can't tolerate more error. Check more. I can't tolerate more error. Check more. I can tolerate more error. Check less. It depends on what you want from that methodology. Clear? Then desired level of confidence. You want more confidence. Check more or check less? Check more. You want less confidence. Check less. You have more confidence. Check less. You have less confidence. Understood? So it's all about the question. Just to with now students know keywords you have given, sir, we will go and blast that only in the exam. And exam guy saying, I have more confidence, what should I do? Check more. Now he will tell, correct, you should study more. So next attempt, study more and come. Clear? So see what they are asking in the MCQs also, or in the any case, depends on what you have or what you want. Clear? Right. Simple logic I'll ask you, if you have more money, will you work more? No. You want more money. See how the proportion changed. Clear? Just the word of want and have. Clear? Wants are unlimited, you will keep on working. But if you are having enough money, then I will work less. If I want more money, I will work more. So it depends on what objective you want from that particular sampling technique. Clear? Sample design, sample size and sample selection. How I should design my sample, sir? Design means pattern. How many, what type of units must be there? Not how many units. How many units is what sample size. What type of units must be there in the sample? That depends on what is the purpose of your audit and specific type of procedure that you want to put. Sir, if I want external confirmation procedure, my sample should involve outside people. Clear? But if my procedure is only checking the documentation, my sample should involve a lot of checking of documentation and not people. Clear? So depending upon what is your purpose and what is your procedure that you want to execute. Clear? Now, consider the nature of AE to be obtained. What type of evidence do you want? Do you want a written evidence, right? Or do you want an oral evidence? Do you want an audio visual evidence? What type of evidence you want? Accordingly, you need to select the sample from the population. Now, consider possible deviation or misstatement. Now, in sample, no, these both are called as difference. Clear? These both are called as what? Difference. Now, if you are a TOC difference, then we call you as a deviation. If you are a TOD difference, we call you as a misstatement. How, sir? Logic you understand. Whenever a control system is not working according to the instruction, it is not misstatement. Because what is misstatement? Difference between amount, classification, presentation, disclosure, what you have done, versus what you are supposed to do or what you should do. Amount, present, classification and disclosure. They never spoke about controls. Clear? Because control can't be a misstatement. First of all, controls can't be stated. Controls has to perform. So performance is what we call as deviation if there is no proper performance. Clear? For example, in Robo movie, Chitti was designed to help the soldiers. Yes, that is the logic. But Chitti fell in love. Deviation. Clear? He deviated from the control mechanism that I put. The system is not working according to how it should work. It deviated, sir. Higher the deviation, riskier the control is. Clear? Lower the deviation, less riskier the control is. Clear? So if there is a high deviation, then obviously the risk is high. If the risk is high, more procedure, more evidence. Okay? Right. Evaluated expected rate of difference. Evaluate. Now, whatever is your expectation, if your expectation of difference only is high, I will end up checking more. Okay? Then divide the population through stratification or value weighted. What do you mean by stratification methodology? Very simple methodology. What does stratification means? Converting the population into subpopulation by having similar items. Example. Now in the class of CA Inter, 100 students are there. Now it is still a homogeneous population. I am further converting that into very similar items. For example, in school days, you have this particular method. 60 to 70 one population, 70 to 80% one population, 80 to 90% one population, and more than 90 one population. Right now, that is called stratification. Every one of you are doing 10th only. Every one of you are 11th students only. But in still there also we will have a reduction in the population size by dividing the main population into subpopulation. Why? We are reducing the variability of the items. MCQ question. Clear? Or rather MCQ. Right? Reducing what? Variability of the population. Now everyone has a similar feature now. As close as possible. Clear? Now in this class I will tell all your, let's say for example, white outfit students one group, black shirt students one group. Now that is what I am doing. I am converting the main population into subpopulation just to reduce what? Variability. Okay. From that subpopulation I will pick the students and then I will ask more questions to them and get to know my results. Okay. Value weighted means based on value. For example, debtors. Entire debtor I will divide into population. Like what? Debtors more than 10,000 up to 20,000 one population. 20,000 to 50,000 one population. More than 50,000 one population. Accordingly I can select. Okay. Then sample size. Should the sample size be bigger or lesser depending upon the risk now. So the entire sample size is influenced by one particular person called sampling risk. Now what is sampling risk? You giving wrong opinion is what we call as sampling risk. Imagine you took that blood sample of some other patient and gave the report to some other patient. Clear? Now imagine patient A went for malaria, patient B went for HIV. You give patient A HIV's report and he is very happy because he saw positive thing in life. And he's like, yes, HIV positive, I'm good. Not all positive are positive and not all negative are negative. Clear? Now imagine there, the blood sample you picked is wrong. Your testing might be correct. Sample is wrong. At the end of the day, the result will be wrong. See, whenever we have an output, now we have two factors here. One we have input, one we have process. Your process might be right. If your input is wrong, your output will be wrong. Your input is right. If your process is wrong, output still will be wrong. So imagine you pick wrong sample, your definitely opinion will go wrong. Now that is the reason, because to avoid this sampling risk only, we are including technology into the audit arena so that we can bring out more precise opinion. Okay. Right. So use statistical or non-statistical depending upon your content or depending upon your judgment. Right? Whether you want to use non-statistical, use it. Your mother, the way she cooks, it is non-statistical. But you cooking is statistical. You measure everything correctly. Yes. Now, if they say for 5 minutes you have to marinate paneer, 5 minutes only you will marinate. Whereas your mother, she'll marinate for 5 hours also. She know how to manage that. Clear? Whereas, we will go by that particular methodology only. Clear? So we need to understand where, how to handle. If you have knowledge and experience, you can use. non-statistical. If you are newbie, you better use statistical. Okay, what are the factors affecting the size? One of the dangerous question in the exam, because in ICA material, no, they have named this as examples. Clear? And 2 pages they have given for that. Now, who will give 2-page examples? Clear? And that will be asked as a question for 4-5 marks. Try to understand. For 2 things we need to have sampling. For TOC also we need to do sampling. For TOD also we need to do sampling. In case of TOC, extent of reliance on ICS. Listen to my question and then answer. If you are relying more on ICS, will you test more or test less? Test. If you want to rely more on ICS, I will test more. If you want to rely less on ICS, I will test less. Clear? Tolerable error range. If you can tolerate more error, test less. Right? If I don't want to tolerate more error, now this has to do with sample size. If you want to test more, do you want more samples or less samples? More samples. Less testing will result in less samples. Same, apply this with your exam. You cannot tolerate more mistakes. More questions you want to solve or less questions you want to solve? More questions you want to solve. Clear? Deviation rate expected. Meaning what? If you are expecting more deviation, should you check more or check less? Check more, therefore, more samples. Imagine January attempt, you are expecting it to be easy. Will you study more or study less? Study less, because you are expecting it as easy, therefore you study less. But ICA surprises you. Now, if you are expecting a difficult attempt, study more or study less? Study more, therefore more questions or less questions? More questions. Clear? Then assurance level desired. You want more confidence. Study more or study less? More questions or less questions? Same logic. If you want less confidence, I have not seen anyone, but okay, anyway, if you want less confidence, then study less. Therefore, more questions or less questions? Less questions. But we have a weird combination in CA. I want more confidence, I will study less. And therefore, less questions. Clear? Because that is how students see. But formula is very simple. You want something more, you have to work more. Therefore, more sample units I will have to pick. With respect to TOD, how much checking I should do? Reliance on other procedures. TOD plus other procedures are there. 2 options are there. I am relying more on OP. Will I rely on TOD more now? No. Therefore, I will test less. Therefore, lesser sample size. Tolerable misstatement. I can't tolerate more misstatement. I will test more. I can tolerate more misstatement. Test less. ROMM evaluation. More risk you are getting to know. Risk is more. Check more. Units more. ROMM evaluation is less. Check less. Units less. Assurance level desired. Same. You want more confidence. Check more. More units. You want less confidence. Check less. Less units. What are the different methods, sir? Random sampling. What does random sampling means? Without any bias. In there are 2 methods, simple random and stratified random. What is simple random? What is simple random? What we have done in class? Random number generator. In random number generator, we will tell minimum 1 we have, in maximum we have 1000 or 100 units in the population. I want 5. Generate first one. Item number 52 you take and check. Next, item number 94 you take and check. Next, item number 19 you take and check. Now this is called simple random sampling. Then we have stratified random sampling. Now what is stratified means now? Creating the population into subpopulation, and then from that subpopulation we pick random. Right? Now in a bowl, Mentos lime, Mentos orange, Mentos cola, Mentos watermelon, Mentos mint. All population is there. We will convert that into subpopulation. Mentos lime 1 population, Mentos orange 1 population. Now from that subpopulation, we will pick 2 units randomly. That's called stratified random sampling. Then we have interval or systematic sampling. Very easy things to do. Sir, take the number of population, items in the population. What is it? Let's say 100. How many units you want? Select a population size. Let's say 5. Clear? I want only 5 items out of that 100. 100 divided by 5, how much? Every 20th unit I will take and check. Now imagine I want only 10. 100 divided by 10. Every 10th unit I will say 10, check. Now for this only, don't tell that I want 13.5 units. 13.5 units and all you cannot take. Just for calculation purposes, you have to do that. But if you see, whenever we are picking an item, now we pick a whole number. Okay. Right. Next is monetary unit, very similar to interval sampling, but the output is not in units, output is in amount. Now, for this one in regular class, no, length of an example I explained, clear? But I told you not required for exam, because in your IC material also they have given only 2 line of explanation for this, clear? Nothing more is there. What they are telling, it is nothing but value weighted selection. But if you see, we had one lengthy example for that, clear? Remember, step 1, step 2, by the time you reach step 3, no, students had understood, sir. I understood what they understood. Clear? So basically, very simple. See, in interval, what we do? 100 by 10 we do. So we know every 10th unit we have to take. Whereas in case of monetary unit, 10 will still remain the same. We will not take 100. We will take the value, total value of 100. Imagine total value of 100 is 1 lakh rupees. The total of 100 invoices is 1 lakh rupees. So 1 lakh divided by 10 I will do. How much it is? Now I will have to take every 10,000 rupee to check. But you tell me every invoice will be billed as 10,000 only. No, some will be 5, some will be 7, some will be 13. Any amount can be there. The output will be in money. Whereas your output is not in money. So it is copy paste of interval only. Just that the numerator is different. Because of numerator, the output also will be in rupees. Clear? That's why we call that particular sampling as monetary unit sampling. Here, interval systematic unit, every 10th, every 20th, we know that. Inventory will be 1, 2, 3, 4, 5 units. There will be no 1.5, 2.5, etc. Whereas here, if you see, output also is in the terms of money, because our population also is about money only. Okay. Next. I will not sit and explain that example in marathon classes, because in regular classes only I know you would have skipped it. Clear? Indigo flights are not flying, but your examples will be flying over your head. Haphazard sampling. What does haphazard means? No structured way of sampling. This is clearly how we study. Clear? Now, how we study in haphazard manner? We take one accounts and we start solving. We felt bored, we go to law. There we felt bored, we go to accounts. There we felt bored, we go to accounts. There we felt bored, we go to accounts. Meaning, in the entire intermediate, no, you get bored, accounts. You have energy, accounts. You don't have energy, accounts. You're bored, accounts. You're sleepy, accounts. Friend is coming, accounts. Relative is getting married, accounts. No wonder you will score good in accounts. Clear? My strength is accounts, study more. I am weak in law, study accounts. I am weak in audit, study accounts. 5, like how Haishwara says, 5 problems, 1 solution. We have 6 papers, only 1 solution. That is accounts. And first paper accounts, give 10 days for accounts. Clear? Law, leave it, sir. Tax will leave us. Clear? Yes. Costing, no good relation we have. Clear? Audit, definitely alien. Right? Now, we have to work on weak areas, but we don't work on weak areas, we work on our strength areas only. Now, in that case, that's a haphazard way of studying. There is no plan. There is no structure. Obviously, the results also will be haphazard only. So, when we don't have a proper structure, how do you prove that you have studied properly? There is no proof of it. Clear? There is absolutely no proof of it. And for that reason only they say haphazard is very, very difficult to prove it. Remember one thing in exam in MCQ, haphazard if you are using, no, you can't use statistical approach. Because statistical and haphazard are opposites. Are you getting my point? Statistical and haphazard are opposites, because haphazard doesn't have a technique. Statistical has a technique. They follow formulas and mathematical laws. You follow your gut feeling. Clear? So we cannot use in the MCQ. Please be careful. Haphazard does not have statistical approach. There you have to use non-statistical approach only. Then we have block sampling. Block sampling means what? Imagine your population. Adjoining items you have to take. What is adjoining items? Imagine in this class I have to create a sample now. Right? Now out of let's say 100 students, I need 10 particular blocks. Now how will I create the 10 blocks? I will not say that. Let's say Naveen, Lakshman, Hari and this fellow be one group. I will not see that. First bench one group, second bench one group, third bench one group. Whoever is sitting there is group only, whether you like it or not. Clear? So I will create a block of adjoining items. I will not change the position of the items and then take a sample, that becomes a biased sample. Clear? That becomes a biased sample. If you are making a team, no, you have to make team based on the adjoining things there. Adjoining things what? Sitting next to each other. Now, let's say for example 1 to 100. I'll say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, one group. 11 to 20, one group. I can't say, sir, 1 to 10 is there, 11 to 20 is there. Let's take 15 from there, let's take 5 from here and change the position. Now also 10 only, no. Now also 10 only. But the block is not correct. You have changed the block. Clear? Now in that case, that is not called block sampling. Block sampling is you are selecting units of adjoining items. Okay. Now what is sampling risk and non-sampling risk? Sampling risk is that risk where your conclusion based on sample is different from conclusion of the population. That risk we have to reduce. Can we eliminate that risk now? Yes, we can, provided you don't go for sampling only. But with the sampling, can eliminate that risk? No, we'll have to reduce that. To what level? Acceptable level. For that, what I should do? Statistical should I go or non-statistical should I go? Professional judgment, correct. Now, you as a professional, you tell me. Huh? Sorry? Statistical or non-statistical? Statistical. Why? Because there is one advantage in statistics, sir. It is widely accepted method, more defensible for me. So tomorrow when somebody questions me, I can defend myself. The entire world is following standard deviation. I am also following that only. If you are questioning me, question the entire world also. But if it is non-statistical, no, I can question you. Why did you pick it? Clear? Now, defending myself is very difficult in that. Basically, we have to see, can I reduce the risk? Now, you reduce the risk by sampling, your statistical sampling or non-statistical, I don't care as long as you are reducing the risk. Okay? Right. What is non-sampling? Anything apart from sampling risk is called as non-sampling risk. Example, human mistakes. Sir, like for example, you read the report. They have given HIV positive. You are very happy. You are celebrating. Now, you read the report wrongly. Does that mean blood sample was wrong? No. Procedure was wrong? No. Output is wrong? No. What is wrong? Interpretation is wrong. You read it wrongly. What can I do now? Clear? So that is non-sampling risk. Misinterpreting the result, it is wrong. Relying on erroneous information is wrong. Everything is right. Data is wrong. Whose problem it is? Sampling problem or non-sampling problem? Non-sampling problem. Applying wrong procedure. Wrong sampling problem. Basically, input plus process is output. Sir, sampling only targets what? Input. It doesn't target your procedure part. It only targets your input. If input is right, sample says output can be wrong because it is wrong procedure. But this wrong procedure has nothing to do with sample. It has to do with your interpretation, your calculation, your knowledge. Clear? So as long as input is right, sample says I am good. So you have to pick the right sample. You asking wrong question is not sample's problem. Understood? Clear? Okay, sir. Now, because of sampling risk, you will end up telling two things. Number one, you might end up telling controls are very good. But actually, what is the status of control? Very bad. This you will lead and tell there is no misstatement at all. Because controls are very good. Now, sir, you did not check the samples properly. You picked only good samples. And you ended up telling what? Controls are very good. No, misstatement also is there. This will lead to inappropriate opinion. Now, this exactly will lead to audit risk. This will lead to audit risk. Now, what do I mean by audit risk?
Inappropriate opinion.
Yes, inappropriate opinion when the financial statements are materially misstated. So here, when material misstatement exists, you are going and telling what? No material misstatement, which is exactly audit risk. So therefore, you select, that means you have not done the audit properly. Number one. Number two, you have not picked the samples properly. Clear? One of my neighbor was doing CA. Clear? He started doing CA right after I became a CA because his mother told, if Karthik has done, you can also do. Clear? So he came and asked me, I want to do CA. I said, do. Because there are some lessons which you have to learn only while experiencing it. Okay. So I never told him that CA is difficult. I said, CA, boss, if I can score 60, you can score 80. Do it. Okay. He went and started doing CA. Clear? Now those are the ones who put me down while I was doing CA. So I need to show them now how it is to be there. So I said, do it. Now he started doing it. Clear? And foundation exams, that time it was foundation and not this foundation. Okay. So December attempt it was. So in the month of November, I met him. I'm like, how's your studies going on? Hey, I faced 3 times revision. I'm like, so you're ready for December? Yeah. No problem. He went and wrote. Clear? Got 60 marks. Total. Okay. And then I asked, what happened? He's like, no, I solved all the questions. It was very easy. I don't know. I think institute fails, no? I'm like, yeah, of course. Institute fails. Yeah. You know, the person who doesn't know how to dance complains about the floor. Okay. Now, then I said, no problem, da. Next attempt you can try. He's like, yeah, next attempt I'll try. Clear? He started doing CA when he was in BCom. Clear? His BCom got over. He still didn't clear CA foundation. Reason is, the way you are studying only is wrong. Because you are picking only easy questions and telling subject is easy. When you pick tough questions, you get to know what actually is CA. Clear? So when you are picking easy questions and you are solving only easy questions and going to exam, very big risk you are taking, because you will tell that, sir, I have a very good study strategy and I found all questions to be easy because you took only easy questions. Clear? Now that means the sample that you have picked is wrong. Clear? Now when I did my finals, even I picked sample question papers, but that sample question papers was never biased. Clear? It was random. How random was? So random that my population consisted of 34 papers. Okay, that is 17 years. 17 years is 34 papers. Out of 34 papers, I wanted 10 papers. Now, which 10 papers I should take? I didn't sit and see which year I should pick and all. I just asked my wife, tell 1 year. So she says 2005, pick 2 papers from 2005. Clear? Then now my chance. One chance you will tell the year, one chance I will tell the year. So I said, okay, 2005 is gone. From 2000 to 2017, we had picked the range. 2005 is gone. For me, India won the World Cup in 2007. Let's take 2007. I took 2 papers from 2007. Then she's like 2013. I took 2 papers from 2013. Then I said 2011. Like that, randomly 5 years I picked and we started solving the questions. Then I said 1 more 5 years will take. 1 more 5 years will take. Like that, 17 years question paper we solved. Was there bias here? No. But we are picking only easy question papers and then solving. Then it will become a bias. Your opinion on the exam will be wrong. And in the exam, you will see the solar system revolving on your paper. Stars, moon, everything you will see there because you picked the wrong sample altogether. Clear? This will lead to inappropriate opinion. Therefore, it affects your effectiveness. Your methodology was not effective. Your audit is very bad. Clear? Next opinion you will give, ICS is very less effective, but actually it is more effective. You say material misstatement exists, but actually there is no material misstatement. This will lead to additional work to establish your initial conclusions were incorrect. It will affect your efficiency. Double the time you have to put for the same audit. Sir, this is also audit risk only. You tell me actual reality, ICS is very good and there is no material misstatement. How will client allow you to go out and tell that I am a bad person? My financial statements I have prepared properly. Material misstatements are not there. ICS is very good. Will I allow you to go out and tell that financial statements are bad? No. How will I allow you to tell that? I will tell what you are telling is wrong. Now, if to prove that you are wrong, you have to do entire audit again. So that means you are putting twice the time and effort for one audit, which will affect your efficiency. Clear? That's the reason why here client will not tell anything. Why? Actually there are misstatements, but you are going and telling no misstatement. Client is like, super sir, I love you. You won't tell like that every year. Clear? I am happy with that. But here will management be happy? No, because they say there is no material misstatement only. How dare you go and tell my company is wrong? Therefore, to prove what you are told is wrong, you have to do additional work. Okay. Now we have picked the sample. We need to perform the procedures, project the misstatement and evaluate the result. Now you have picked the sample, put the procedure on each item. If the procedure is not applicable to above item, then apply it on a replacement, meaning replace that particular item and then put the procedures again. For example, I picked 5 students. One of the student told, sir, I was absent yesterday, which means I can't ask questions to him. I need to replace that student with someone who was present in the class. Okay. Then, if unable to apply, treat them as deviation in case of TOC, misstatement in case of TOD. I already told you, in control, we never say misstatement, we always say deviation, MCQ. In TOD, we always say misstatement. Now, misstatement only will be projected. Moral of the story, very good hidden question. Deviation can never be projected. Only misstatement can be projected because SA 530 has an assumption that the control deviation is nothing but your sample deviation. Imagine there are 100 controls. You have picked only 10 controls and you have checked it. Now, SA 530 says whatever deviation you have found in that 10 is the deviation found will be found in 100. There is no fluctuations there. Same deviations you will find in population as well. Same logic here. Projecting means what? Estimate or forecast. Clear? Of what? Of misstatements. Never of deviation. Clear? It is made based on conclusion of sample. Why do we want? We have to project it. Imagine out of 10 samples that I have taken, 6 are wrong. Right? 10 sample I have taken, 6 are wrong. Out of 100 I picked 10. In the 10, how much I got wrong? 6. What is the percentage? Out of 100, my sample is 10. Okay. And out of the 10, when I evaluated, out of 6 out of 10 samples, I found misstatement. Therefore, what is the percentage of misstatement? 60. Sir, in 10 only 60%. Na? In 100, it will be. In 10, it is 60%. In 100, it will be 60 units might be misstated, sir, which is a very high misstatement. Go and check more. Either pick a bigger sample size or go to the management and tell, boss, what nonsense population you guys are having. 60 units are wrong here. Go and correct it first. And after this only SA 450 will come into the picture. What is SA 450? Evaluation of identified misstatement. Once we identify, we'll go and tell whom? Management. So identified, reported. What is their job now? To correct. If they correct, good boy, unmodified opinion. If they don't correct, modified opinion because they are a bad boy. Got it? Understood. So here what we'll do? We have picked a sample, test that. Yes, after testing, we'll get to know how much is wrong. That whatever wrong is there now, you got out of sample. Now that should be projected to the population. Extrapolation method, cross multiply and get to know how much could be there in the population. Sir, is this accurate? No. This is just to give a range. A broad scale is what we'll be giving. Right? While estimating, you have to exclude anomaly. Who is this anomaly? Anomaly is an exception. Unusual item. Clear? Sir, unusual item will never be projected. Assumption, this guy will never be there in the population. On sample, he might be there, but he will never be there in the population. Understood? That fellow is called as anomaly. Imagine, I picked 10 units out of 100. 6 I got misstatement. Out of that 6, now here is where super concept comes into the picture. Listen to me carefully. What is the population? 10. 100. How much sample I picked out of it? 10. How much misstatement I got? 6. Out of that 6, one guy, one misstatement what I found, when I asked management, management said, sir, that one day actually system had some issue, sir. Clear? Because of that issue, this misstatement happened. We corrected that particular situation right away, sir. Now I got 6 misstatement. Out of that, one was exception. One was what? Exception. Now you tell me, once you get a confirmation that it happened only once, is it right for me to project this in population? No. Therefore, out of 6, eliminate anomaly. Now how much you have? 5. Now project. Now project. Out of 10 I found 5. Out of 100 it will be 50 now and not 60. There can be a difference now because we never expect exception in the population. Understood? But for that you have to first be certain whether it is an exception or not. What if it is actually not an exception, disguised as exception? That is very important. So whenever we say anomaly, first check whether that fellow is anomaly only or not. Clear? If he is not an anomaly now, then in the population also he will be there. So high level of certainty first we need to see whether he is an anomaly or whether that exception is an actual exception or not. Don't trust the management blindly. Got it? Understanding? Okay, sir. Now, no need of explicit projection in case of deviation because there is an assumption that sample deviation is equal to population deviation. It will not be more, it will not be less. Yes, sir.
Sir, they told it is only for the 1 day, right?
Correct.
Then how can we project it to 50?
I didn't get your question.
No, sir. They told only it is.
Which one? Anomaly you are talking? Okay.
It is only 1 day.
It happened only once, they said.
Once they said.
Correct.
How can we project it for the rest of 100 units we are going?
That's why we are excluding that. That's why we are not projecting at all.
It happens only 1 day.
We are excluding that. We got that. See, it happened only 1 day. But in my sample, I got that. Yes, when I got that in the sample, when I checked that I am projecting, management said, sir, this you can't project. Because this happened only once in the entire year. How can you assume that it could have happened other time also? Now, when management told me that, I should question the management, prove it to me, it happened only on 1 day. Once he proves it, I will remove that. Then I will project only the usual ones. So basically out of total misstatement, remove the unusual appearance and then check the projection. You are right. What did you ask is your answer. Your question itself is answer. You said it happened only 1 day, how are we projecting? We are not projecting at all. Are you getting it? Because it is an exception, we are not projecting. It can't happen. But before excluding, I should take certainty that it actually is an anomaly. Now, when management says I will not remove, I will first go and check it happened only on 1 day or it happened on multiple days. If it has happened on multiple days, then it is no more an anomaly. If it has happened only on 1 day, I understand that. That day's misstatement I will ignore. Like, for example, to give you an example, because you are very good in accounts, everything is accounts now for you. In goodwill calculation, when we do super profit, when we calculate, we have to first take average profit. Yes. Now, last 5 years average profit, they will tell. Right. Now, you tell me, if I am calculating goodwill for Dolo company, technically Dolo 6 is not by Dolo company, it is manufactured by some other pharmacy. Now, imagine for their calculation of goodwill, I take last 8 years. Now, when I take last 8 years, should I include the year 2020 and 2021? I won't. Because it is a COVID year. Now, you will be asking why, sir? Only because of the COVID scenario, that year they shot up their revenue. Clear? So, it's an unusual spike I am seeing. Every year, there is on an average 10%. COVID year, 100% revenue increased. So, am I expecting that to happen in future? No. But can I expect the other year's growth in future? Yes. The COVID year alone I will exclude and other years I will take and then I will project it. Clear? That is what you guys did in goodwill. Extraordinary profits or extraordinary loss if it is there, you ignore that year. Why? That year also I did business. No. Because we are not expecting that to happen in upcoming years. That is an exceptional thing. We will never say, sir, COVID happened last time, COVID happened this time also, sir. That exception, that is, we cannot expect that to happen again. Got it now? But, if you are excluding, what you should do first? Take certainty that it's actually an anomaly or not. Okay? What if that increase was never because of COVID? If it is because of COVID only, I will ignore that. Okay. Nature of cause. Once you get to know, find a common feature in all deviation or misstatements, investigate nature and causes. If there is an anomaly, now see, obtain certainty to ensure that it is not a part of population. Technically, this should have come before. This point should have come in the before concept. But ICA, clear. So what they are telling, if it is an anomaly, what you should do? Obtain high level of certainty that it is actually not a anomaly or it is not a part of population. If it is a part of population, boss, then I will not ignore that. Okay. Evaluation of results. If in case of TOC, high deviation rate means high risk, therefore more procedures or less procedures. Risk is high, more or less, more. Therefore, sample should be loose tools. It is results we are talking about. Sample is already taken. Clear? Don't be a parrot. Listen to the concept and then answer. Here, sample is already picked. Testing is already done. Clear? Now we are evaluating result. If risk is more, we need to get more evidence. If we need to get more evidence apart from sampling, check the details now. Clear? Check the details. Don't rely just on sample. In case of TOD, high misstatement means what? A, B, C, D is materially. That means again high ROMM. High ROMM means high evidence. Understood? So checking will be increasing or decreasing? Increasing. What is my best estimate? Projected misstatement plus anomalous misstatement. What is my best estimate? Whatever I projected plus exception. Both are misstatements at the end of the day. Even if it is an exception, it is still a misstatement. Okay. Now comes the most important part. Listen to me and then understand. I told you if it is an anomalous misstatement, I will exclude it. Number one. I excluded from the projections because I'm not expecting it to happen every year. That doesn't mean the amount of the misstatement I should ignore. No. Now imagine one invoice was entered wrongly. Clear? That one invoice I will ignore from the projection. But the amount of that invoice is still a misstatement only, no? It is still there in the financial statements, no? Don't you think I should rectify that? Even though it is an exception, I will not expect it to happen. But whatever has happened, can I ignore that? That I cannot ignore. So amount of anomalous misstatement should not be ignored. Occurrence of anomalous misstatement can be ignored. Very important concept. Amount of anomalous misstatement should not be ignored. Occurrence of anomalous misstatement can be ignored. Because we never expect. Now, Dolo example I gave you. We never expect COVID to happen. That does not mean the company never earned a big revenue during COVID. No, they still earned. Yes, revenue we will consider. But we will not consider for the purpose of goodwill calculation there. Still, total revenue last 8 years when we say, we will still include that revenue. So, amount of anomalous misstatement should not be ignored. Occurrence of anomalous misstatement should be ignored. Clear? Okay, sir. Therefore, if projected misstatement plus uncorrected misstatement, what does uncorrected means? Identified, reported, but not. If it is more than my tolerance limit, then sample is not good for me. My tolerance is only 100. I projected 60. Clear? I projected how much? 60. Before that, whatever I have identified, that also I have identified, reported and told it to the management. Now, that is, let's say for example, 30. I have told 40, but they correct only 10. So, total mistake, uncorrect misstatement is what? 30. Is it more than 100? No, it is not more than 100. Therefore, no problem. Sample gives me good opinion. But what if my projection is 100? My tolerance is 100. Clear? Now, imagine whatever misstatement I have identified, reported. Now, management has to correct it. I have identified 20 misstatements, reported 20. Okay? Management corrected only 5 out of 20. How much is uncorrected now? That if I will add here, and is it more than 100 now? Therefore, I can't trust the sample because management has not corrected the misstatement. That means misstatement is still there in the population. I cannot trust it. Clear? Projection is nothing but an assumption. Expectation. It may be accurate, may not be accurate. But this is accurate out of sample. Now, whatever I have identified and told, you are supposed to rectify that. You did not correct it. So, I can't trust the sample anymore. Next, if projected misstatement is more than expected misstatement, unacceptable sampling risk is there. Meaning what? Now, understand, forget about the text, try to understand the concept. Before I start sampling, I will have an expectation. After understanding entity, environment and all, I will have an expectation. I think this, in this sales now, after understanding all what he told, this sales might be misstated. Around 100 misstatements I am expecting. So I have an expectation in my head. I will start the audit. I will go for sampling. I will start sampling. Now imagine while sampling, I have to project also. What is there in my head expectation? 100. Back of my head, my expectation is 100. I will start sampling. I got a projection of the sampling. The projected misstatement is telling 80. How much do I expect? How much is projected? Is it within my limit? Sampling is good. But how much I was expecting? 100. I went to sample. I started checking. I got misstatements. That misstatement I projected, I got 200. Is it greater than my expectation? Yes. Therefore, unacceptable Sampling risk. My expectation only was 100. My projection is going beyond 100. I can't do sampling. I have to test of details only. I have to go for 100% checking. I cannot go for sampling. Remember, expected misstatement comes even before I start sampling. Projected misstatement comes after I finish sampling. So what you expected initially and what you got the misstatement, compare that. Your projection, if it is more than expectation, that means imagine actually how much it could be then. Because projection is a range, it is not accurate. So actual misstatement out of the total population could be more than 200. Therefore, I cannot trust the sample. I will have to go for 100% checking. My next question to you. What is sampling? Anything less than 100% is called. What about 90%? 99%. Still sampling only. The only difference is one sample is bigger, one sample is smaller. Where the risk is more lesser? Bigger sample or smaller sample? Where the risk is more, I am asking. Risk is more where? In smaller sample or bigger sample? Smaller sample. If I take a bigger sample, risk will increase or risk will decrease? Decrease. Why? I am checking more. I hope you got that. Clear? So if the sample size is small, risk can be more. If the sample size is bigger, risk can be reduced. Understood? Clear? Okay, sir.
That is sampling risk.
Yes, that is sampling risk. If sample does not provide reasonable basis, then what we should do? Ask management to go and check the entire population. Go and check how much is the actual misstatement and make necessary adjustments. Basically, start checking more is what they're telling. Go for the detailing or choose some other method. Clear? Okay, sir. This is your essay 530. Right. Now, let's move on to the next topic. Right. Audit risk and risk assessment. Okay. Let's talk about it. Now, this chapter has multiple parts for you. Chapter number 3. Chapter 3 has multiple parts. Study like that. Do not ignore this chapter. Those who have ignored have regretted before. But I'll tell you, if you are trying to skip, at least do some portion of it. You already calculated risk. If you're skipping this, that means you should be thorough in other chapters. Okay. Now, in this, you have SA 315 concept, which talks about risk of material misstatement. Clear? Then you have SA 330, which talks, here it talks about RAP also. Here it talks about further audit procedures. Okay. Then you have topic of internal control system. Here elements of internal control system, limitations of ICS. Then you have advantages of ICS. Okay. And then checking techniques of ICS. These things are there. Then you have automated environment. Clear? Around 8 to 10 questions are there in this. Clear? 320 is in between these two. Okay, it comes as a topic here, not as a separate standard. They have given as a standard. It's like a sandwich there. Okay. So these topics at least you do. 320 comes as a small materiality concept, which dedicated questions very less they can ask, but they can still ask there. Right now, these 4 topics are there. Right. Out of these 4 topics, see, this you can study at any point of time. There is no relation between this and some other topic. If you have understood, as of now I am telling, if you are a first time or no, please don't follow this advice. If you are a first time studying audit student, don't follow this advice. Clear? This is only for those who have done the studies and now revision part of it. Do automated environment whenever you want, no problem. Clear? In internal control system, elements and techniques, do not ignore. 6 elements are there. Clear? Do not ignore that. That is control environment, entities, RAP, information system. Then you have monitoring, control environment. These 5 elements are there. Don't ignore that. Okay. Techniques, your internal control questionnaire, Then you have narrative record. Those things do not ignore. At least these two you do. Essay 330, we have covered it as a separate procedures only in the regular classes, where I have not told you what is that particular essay, but I have covered as a concept right from basics of audit only. But then when we go there, we got on it as essay 330. The proper technique to revise essay 315 and 330 is together, because both come under the heading called as audit procedure. Clear? Audit procedure of two types, RAP and further procedures, further divided into test of controls and substantive, substantive into test of details and analytical procedure. These come under SA 330, but RAP comes under SA 315. So recommendation is study both together if you are revising it. Clear? Now at least these you do and go. Rather than completely ignoring it, see what is there in SA 315. Clear? In SA 315, techniques or your procedures for RAP, IO, analytical procedure, inspection, inquiry, observation. At least those you do and go, from whom I am supposed to inquire certain things. Those questions have come in the exams before. For those other, there is one more way. If you are not, a fan of marathon or so many hours I can't see, you can always see chapter wise. Number one. Clear? Number two, apart from this, just take last 3 attempts RTP or 4 attempts RTP, 4 attempts mock papers you see, any chapter that you are going to skip. Because I know at the end of the day, no matter how much a teacher or institute says do 100% portions, you will not do it because of the limitations. Clear? Now, for those chapters which you are skipping, at least for those chapters, do last 4 attempt RTPs. Last 4 attempts mock papers, which means hardly every RTP will have 1 or 2 questions. 4 attempt RTP means what? Max to max 4 to 8 questions you are solving on that particular concept. In some RTPs, some concept may not be covered. So last 4 RTPs you take. If possible, start from May 24 only, maximum 5 RTPs you will be having now. So finish off that 5 RTPs. Last 3 to 4 attempt mock papers you take. Every attempt mock papers will be 2 series. So 2 questions you might have to see. Worst case scenario I am saying. So that means every attempt 2 question means last 4 attempt means 8 questions. 16 questions you see and go. Because you never know. What if the same question is there in the exam? You will be thanking that. So those chapters which you are skipping, don't skip blindly. And I am telling you, people who come and tell after exam, after they clear, no, I have skipped this. Believe me, they have not. Clear? Nobody blindly skips anything. They have a calculated risk for that. They will just say, I am skipping this rather than doing the entire portion. Let us do a selective based studies there. How will they do selective based studies? Not on bullseye method. Clear? They will go and see institute publication what they have asked. That only they will do and go. Some confidence must be there in this particular chapter. MCQ easily you can score. Clear? May 25 MCQ 6 marks out of ICS. Techniques only they have asked. 2 marks. Clear? So easily you could have scored 6, but you do not know, you skipped completely. That easy marks also has gone. Clear? So let's talk about essay 315. But before we talk about essay 315, we need to know what is audit risk. What is audit risk? You giving inappropriate opinion. Sir, is there anything called as right opinion or wrong opinion? No. Everything is right, everything is wrong depending upon your judgment. So opinion is yours, therefore opinion can be appropriate, opinion can be inappropriate. We should give appropriate opinion, meaning giving unmodified opinion when financial statements are materially misstated. That is very, very wrong. Clear? Possibility that audit could miss important aspects. Okay? Meaning the way you do audit, you're missing out on important aspects. That risk is what we call as audit risk. Now my question to you, why did you take up, those who have taken coaching or those who are coming to marathon or anything for that matter, why did you choose coaching or marathon? You could have done it on your own. Why did you choose coaching? In 10th, 11th you have never taken coaching, 12th you have never taken coaching, then why coaching at inter level? Risk. You didn't want it to take the risk. What risk you are avoiding? When you are paying so much and you are taking coaching to avoid risk, what risk you are avoiding? Exactly. No sir, will not tell that. See, I believe in hard work. Correct? If I say because I will fail, Then I'll tell all the time, no, I want to become rich, very rich, like Elon Musk. Tomorrow I'll become rich. Now I have to work hard for that, right? So to reduce that risk only, we are taking coaching. Same logic. To reduce the audit risk only, we are checking more. And if you are asking some CA, why are you checking more, sir? Because tomorrow it's my signature which is there. Clear? It is my signature which is there in the audit report. Tomorrow they will hold me liable. To reduce that liability only, I am checking better. For that, first I need to understand how big is the risk. If the risk is more, checking will be more. To reduce this risk, what we should do? Use various procedures and techniques to ensure the accuracy and reliability of financial statements. Number one. Okay. Now, audit risk has three components. How many components are there? Three components. Basically two, but three. So, AR is equal to ROMM multiplied by DR. Sir, why are you multiplying it, sir? Risk doesn't add. Risk always multiplies because the outcome can never be put a scope saying it is only till here. It can keep on growing. It can keep on increasing. So risk always multiplies. Three components. Number one is inherent risk. What does inherent risk means? Level of risk or potential for error in the financial statements even before we start the work. Sir, example for inherent risk is management's attitude of doing business. Can you do anything about it? No. They want to do a business which is risky. Your problem or their problem? What can we do about it? Nothing. See, general example we'll take. Now you have a health risk. If you have a health risk, you will go to a doctor. Clear? Now doctor, what is his job, sir? To treat you, to give you medicines, to give you opinion. Now he gave. You have an inherent risk of eating junk. Now, eating junk is doctor's problem or your problem? Your problem. Now, he will tell, sir, don't do this. If you do this, ROMM will increase. Then we have to go for surgery. Detection risk, if you have to reduce, you have to put better procedures. Better procedure is surgery only. Clear? Now, I am telling, hey, to hell with you. I want to YOLO. You only live once. So, I will go and eat, drink, whatever I want. Now, can doctor do anything about it? No. He will tell, you follow YOLO, sir. Soon you will follow YODO. You only die once. Now, he can't do anything about it because it is inherent risk. So, inherent risk is not under professional's control. It is under client's control. The client has to decide that I will not do risky business or I will put a better diet plan. I will put a better accounting plan here. My accounting should be good. That is when ROMM will come down. If ROMM comes down, no, I need not spend more time at the doctor's place. Are you getting my point? Yes. Now, simple example I tell you. Right from our school days, we have, I don't know in your school, in my school it was there. These Colgate people, Nestle people come and do seminars. Yes. And they give the toothbrush, paste, Maggie packets and all. Now there, we used to go because we'll get some free time with our friends. But they used to always say one thing, no, brush your teeth twice a day. Yes. Now, do we every day follow it? No, sir, we go and sleep. Understood? Correct, without brush only. Now, the question is, I had a jaw surgery long back, okay, during my final preparation. Once the jaw surgery got over, that wisdom tooth removal, that became complicated. So, that time I asked him, what measures you can give me to maintain my health of the oral health, how I can maintain. He said the first thing he said is nothing but, see, what in childhood, what they have told, you have to follow that. Right? I told I've been following but not religiously. And he's like, see, if you don't follow religiously, he gave an entire explanation of what can happen. The food will marinate in your mouth, bacteria will increase, this will happen, that will happen. I'm like, okay, now what should I do? Then he's like, use this toothpaste, use this type of products. I told, see, are you getting commission? So he's like, see boss, I did not recommend any brand. I recommended the content in the product. So you use a product which has these contents. From that day, religiously I follow twice a day. Clear? If I don't have dinner also, it's fine. But before sleeping, I have to brush. Even if I'm sleeping with the one eye, I'll brush and I'll sleep. Clear? Because I am a professional. right? Now, if I have to meet people, I have to maintain my hygiene. Yes. Now, if I'm maintaining my hygiene on a daily basis, I need not go to the dentist every now and then. I need not go to the doctor every now and then. He told me what is the inherent risk. To avoid that inherent risk, to reduce that, I need to take a call. Or even if I'm going for a general checkup, it can happen like this. But if I don't take care of that, then my general checkup only can be for 1 hour. So much problems will be there. So many problems will be there. That is what, as an auditor, when I'm telling my client, see boss, you're doing a risky business. Don't involve in cash transaction. You put UPI. Now I am telling him, but he is not doing it. What can I do? Nothing I can do. Now only job I have to do is either leave him as a client. Hey, you go man, I can't handle you. Now that doesn't stop him from doing cash business. He will still do it. Yes. So I have to put more efforts there. Of course, good only. More efforts is equal to more fees. Clear? More time is equal to more fees. But my point to tell is, this is not my job. This risk is present in the financial statements even before I start the audit. That type of risk is what we call as inherent risk. Clear? Second point, control risk. Control risk is again not my point. It is again client's point only. To reduce that inherent risk, this fellow will put internal control system. Now, you think every internal control system will do its job 100% perfectly? No, sir. Now, you imagine inherent risk is your health issue. You put up a control system that, sir, let us say, twice a day I will not brush, sir, only once a day I will brush. Alternatively, I will brush twice a day, sir. Some events of here, there, I would have missed out on. Clear? Now, you missed out, no. That missing out will still cause misstatement, no. Yes, ultimately, doctor has to treat you. No, the only difference is, if you do not have ICS, treatment will be more. If you have ICS, treatment will be. That doesn't mean treatment is not there at all. Treatment will be there. So we need to check one logic here, whether the inherent risk, whatever you have you reduced that by putting internal control system? That internal control system also will not detect certain misstatements. That put together is what I am supposed to go and rectify. Use the logic. Imagine you have an organization, there are problems. To that problems, you find a solution. Correct? Now, you put all possible solutions, still there are certain problems. That problem should be detected by me. That's why I am a professional. Clear? Whatever ICS you have put, that may not detect every problem. So whatever other problems are there, no, I audit them and I tell what is exactly is a problem, and that you have to correct it. And when you correct that, next year your inherent risk will come down. If inherent risk comes down, control risk will automatically come down. Therefore, your audit risk will come down. Understood? Huh? Clear? I have audited one client for 3 years continuously. First year ROMM, it's going out of the roof. You name the non-compliance in that books of account, it is there. Clear? Then we spent humongous amount of time to rectify that. Then next year, the risk reduced. Third year, risk absolutely reduced. Are you getting my point? So we need to tell the client, boss, see, from your part, you should do two things. Reduce two types of risk. Inherent risk and control risk. From my side, I will reduce one type of risk called detection risk. Understood? So audit risk has two parts, ROMM and DR. ROMM is whose problems are? Clients or management problem. So ROMM has two elements, inherent risk and control risk. Therefore, audit risk is equal to inherent risk into control risk into detection risk. Automatically AR will come down. Is that clear? Yes. Okay, sir. Now, ROMM means what? Risk that financial statements has material misstatement that will not be detected during the audit. So we need to put more procedures to detect these ROMM. What is not included in the audit risk, sir? Number one, expressing an opinion which says financial statements are wrong when it is not wrong. Business risk is not included. Two risks are not included. One is called business risk, which is litigation, publicity, marketing, ad. All these things, if it goes wrong, it is not my problem. And whose problem? Your problem. Then expressing an opinion where you say financial statements are wrong
when it is not wrong. This can never ever happen. If this happens, no, either you are mad or unsound mind person. Because an FS is not wrong, on what basis you are going and telling it is wrong? Do you have evidence for that? No, because books of account is correct. On what basis you will go and tell? Absolutely not possible. So client also will not entertain this. Clear? Whereas the first risk, 100% client will be okay with it. Okay. Now, should I rely or not rely on the controls depending upon 4 factors, that is ICE factors. Clear? I square influence, whether the environment's influence on the control, we should check. See, I should rely on the control. Which control I will rely on? IFC correct. My question is, do I rely on the controls which is good or which is bad? Good. Strong or weak? Strong. Now you tell me, you all understand this. Now ArivuPro has an internal control system of generating QR for attendance purpose. Correct? Now the question is, when you are generating QR for attendance purpose, that is purely and purely for students' perspective to give better inputs to the students so that they can improve their performance in the class. Correct? With that, the incentive is what they say, we will give you recordings. Clear? Now, students don't understand the purpose of ICS and that's why there is a collusion in the ICS. Clear? Now, you don't understand the purpose, therefore ICS will fail. It is not because ICS failed because system is wrong. ICS failed because users don't understand the purpose. Now, imagine from there whatever data we are picking. Clear? Now, what will happen? Let's say for example, you have to scan the QR, mark your attendance and you have to give feedback of the class. Yes or no? Now when you are giving feedback of the class, imagine you will summa give 1 star, 2 star, 3 star and you will give one reason. Clear? Now a person who has never come to the class, now you collude with him, you send a screenshot of that QR to him, he is sitting in some other place, clear, there he will put attendance and he will give one feedback. Now imagine management takes that data to evaluate the performance of a faculty. And imagine they say, sir, you are not performing well, sir. You please leave our academy. Now, on what basis they are telling this? On the feedback of the student. My question, which student gave this feedback? The one who is sitting in the class or the one who is not sitting in the class? Now, you tell me, if you are the auditor of such a system, will you take the system into consideration? Huh? That's exactly my point. Because you are giving me a data from a system which is unreliable. Are you getting my point? Clear? Now that is a question which you have to address as a management now, where you have to tell that, okay sir, how do we curb this also? So that we get a proper authentic data where we can rely on that particular data. Clear? Now, it is not that whether I know that I am teaching well or not. It is a point that you are judging me on a point where we don't know who these people are. Are you getting my point? It's like, I am going and asking the cheta there, how is my classes? Class very bad. Okay, I will stop teaching them. Who gave me the feedback? A tea shop guy. And what decision I am taking? On my life. Clear? It's like a society telling you you can't do CA and you didn't do CA. Right? So authentic data if I am not having, can I rely on that data? No. That has to do with environment now. If the environment is not good, sir, I can't rely on the data. So environment will influence the control system. System sariya irunda is not the problem. Who should be proper? System users also should be proper. So using the system in a bad way is dependent on the environment. Then IT process. Evaluate the information technology there, because information technology is one which is giving you processing. Clear? Then controls over Scott. Don't add H there. Controls over Scott. CH you don't add there. Now what does Scott means? Significant class of transaction. Meaning class of transactions we are talking about P&L. Significant class means what? The bigger expense, the bigger income and the bigger revenue items. For on those, sir, on the bigger expense and income only if the control is good, I don't think smaller expense will have misstatement. But if bigger expenses are not having proper control, then obviously smaller expense also will not have any proper control. So first check controls over Scott. Then expectation of effectiveness. The controls based on entities understanding. So expectation from where will I develop? When I understand the entity, environment
and internal control. There only I'll develop an expectation. So these are the 4 factors I should consider whether to rely on ICS or not to rely on ICS. Clear? If you decide I will not to rely on ICS, that means there are deficiencies. Whenever you identify deficiency, what are you supposed to do? Evaluate the effect on risk assessment. Is risk is more or risk is less? And strategy for audit by determining assertions which are affected by ineffective controls, meaning which areas are being affected by these ineffective controls. So number 1, identify which areas and assess the risk. Then ask the management, do you have more than one control for each assertion? Clear? Sir, that means do I have options? If I have options of other controls, then I will go and test other controls. If I don't have option of other control, if there is no other control, then I will decide not to rely on controls. Okay? Right. There are 2 types of procedures, risk assessment procedures and further audit procedures. What is the risk assessment procedure? Procedure to obtain understanding of 3 things. Entity, environment and what procedures I should put, sir? Inquiry, observation, inspection and analytical procedure, basically IO. AIIO. A for analytical procedure, I for inquiry, I for inspection and O for observation. Clear? Now whose inquiry I should take, sir? Management's inquiry you can do. Internal audit personnel's inquiry you can do. Employees who are entering into, who are there, who's handling transactions you can do. In-house legal counsel for litigation purposes. Clear? Sales and marketing to give the strategy and budgets and other things. Risk management function department to ask them what risks they are taking, and information systems personnel. These people will give you system related data. System changes, who is administrator, what type of system we have. All these inquiry when you do, you will get the information. Now this is a very important concept in the exam. They can ask 1 4-mark question on this. From whom all inquiries we should take. Either 4 they can ask or any they can ask. Okay. Next, we have to do further audit procedures. Now what is further audit procedures? By procedures adopted. Procedures put up to get more evidence. To get more evidence. Procedures put up to get more evidence. Now, there are 2 types of further procedures here. One is test of controls and one is substantive procedures. Now, when do we do test of controls? Before I ask you a question, test of controls we should do. Clear? Now, this is your essay 330 content. So, in your institute material, they have given at the end of the chapter, before your internal control, they have given essay 330, before your automated environment. Now, let me ask you one question. To test this control, where do you obtain understanding? Under RAP. So, keeping that understanding, I will end up testing the control. So, when will I test controls? 2-mark question. Number 1, when I expect the controls are operating. My question is this one. When I am expecting, and where does this expectation come from? Risk assessment procedure. So, when you are expecting that control is good, don't you want to go and test it? Now, I'll tell, in Anandas, there is amazing Kaju Katli available. There is amazing ghee laddu available. I will tell you. Now, you developed an expectation. You want to go and test it there now? Yes. Once you go and test there, then imagine, hey, what Karthik sir, what he told, waste. Now, I developed an expectation. You went there and executed that, and then only you got an evidence that it is not good. So, that expectation will develop only when I talk to the client. Client will tell, this system amazing, sir. What system I have, so much data, it gives you accurate data. I'm like, okay. I went and tested. Yes. Now, then I got the output. Then I saw very good data it gives. That means whatever understanding I had to see whether it is true or false, I'll have to go and test the controls. Got it? Remember, under RAP, I will never test the controls. Write somewhere. Under risk assessment procedures, controls will never be tested. Under RAP, controls will never be tested. Next, TOC is done only in further procedures. TOC is done only in further procedures. Clear? Okay. Or, okay sir, my expectation only is not there. No problem. I will do TOC when substantive procedure do not provide any evidence. Now technically see here, under further procedures I have only two options. One is TOC and one is. Now if substantive procedure don't work, what is the only option left for me? TOC. I will have to rely on TOC. So TOC I will be doing only in two scenarios. Either I am having a great expectation out of it, or it doesn't provide enough evidence. Under substantive we have TOD and analytical procedure. AP is already done in SA 520. TOD has two things, vouching and verification, which is a chapter number 5. Now, under test of controls, the question is nature, timing and extent. What type of examination I should do, when I should do and how much I should do. What type? Perform other procedures with respect to TOC with inquiry. So, inquiry you do. With inquiry, you also probably can do inspection. Clear? Not only inspection, you can also do observation. You can do reperformance, etc. Clear? You can do this whenever you want. But inquiry of how the controls were performed. Consistency, how many times it was performed in the year and by whom it was performed. Or by what means. By what means which type of systems you have used. So these are the inquiry of TOC. Remember, inquiry of TOC, 3 questions. Number 1, how, consistency and whom. Okay. Timing, when should I perform this? Particular time or throughout the period. So should I do it only at one point of time, or should I keep on doing it throughout the period? It is left to CA. Okay. Extent can be asked for a 4-mark question. Extent means what? How much we should perform the controls. Number 1, frequency. Sir, you decide how much I should test. If entity has tested more number of times, I trust the results. But if entity has never tested it more number of times, then I should perform more testing. Clear? Number 1. Number 2, reliance period during the audit. In the audit, whatever period I have during the audit, I am not relying more on that particular control. I will not test that more. If I am relying more on that control, I will test that control more. Expected rate of deviation. You are expecting more difference, testing more or testing less. You are expecting more difference, testing more. You are expecting less difference, testing less. Okay. Relevance and reliability. If the control is relevant and reliable, I will test more. If it is not relevant and reliable, I will test less. Then evidence from other controls. So if I am getting evidence from other controls, the control which I am going to test, point number, that is control number A, I will not test more because I am having another source of evidence. I will rely more there. Clear? So these are the factors to decide how much I should test. Clear? Remember, free factors these are. Free factors these are. F for frequency, R square reliance and relevance, E square expectation and evidence from other sources. Clear? Yes, right. Now this is your main topic of audit risk, that is AR, ROMM into DR. Clear? Now from here only we take off to SA 315 and SA 320 and then we go for internal control. Internal control, here only I am covering it. Clear? Because in this concept only we do it in our regular class also, so I am not going to change that. So components of internal control, if you see 5 components are there, and then we'll go to techniques of ICS and materiality and risk of your automated environment. With that, my main topics of marathon will be done. These are the main important topics which I focus on marathon. Now chapter number 9 and 5 is an optional. If the time permits, then we will be doing that, because that doesn't require any concept. Clear? Those 2 chapters are nothing but procedures. Clear? There is no concept of that, but I'll explain the assertion concept of chapter number 5. Clear? So this is our main agenda for the day. Once we are done, if the time is left, then we'll be focusing on cooperative societies and government audit. Clear? Let's take a small break and then continue. Next, SA 315, continuation of what we had studied only.
So we do a risk assessment procedure and further procedures. SA 315 helps you in understanding the RAP, why we are supposed to do and what we are supposed to, why we need to understand the entity and its environment. ICS we are not going to talk here because it's a separate topic. Okay, why we have to understand to identify and evaluate ROMM. Now this ROMM, like we always know, it is management's responsibility. This mistakes can be due to fraud or can be due to error. So ROMM will be generally at two levels. One is called financial statement level, one is called assertion. Assertion is what we call as root level. Transaction level only they can do fraud or error. And here it is not about transaction level, disclosure, presentation, not disclosing certain things, merging 2-3 expenses and showing as one expense. Those are at financial statement level. Now, why we need to understand this? So that we can design the procedures or respond to the risk. So once we get to know the client's environment, we get to know how risky is the client. According to that risk, we can put up the procedures. Now, for this, what we should do, hidden question, identify the risk throughout the process. So step number one is don't stop identifying the risk. Now, throughout the process of your audit, you have to identify the risk. Once you identify the risk, you have to evaluate the risk. Meaning what, sir? Let's say a client came and told about his business. Clear that he's involved in so and so business, and his business involves cash transactions, bank transactions. Some transaction happens with invoice, some without invoice. Now, for example, I have a client. When I told him you have to maintain books of accounts, purchase, you have to maintain sales, you have to maintain. He said everything I can maintain, sir, but when I'm purchasing raw materials from a specific vendor, I cannot maintain the bill. I'm like, nonsense business then. He's like, no, sir, I can't maintain because the vendor who supplies goods to me, he will never give invoice. Now, if he never gives invoice, I will make payment to him. Yes, now he will never give invoice. What can I do for that purpose, sir? Now that is actually a risk. So according to that risk, I need to respond to that risk. Generally happens when, imagine now, Naveen is a supplier of, let's say, the packaging material for me. Now, if he's supposed to make a sales to me, he should charge GST. Okay, and I should pay GST. Now, if it is B2B, no problem for me. Because whatever GST I'm paying, I'll take a credit of that. Now, still, this fellow doesn't want to show the turnover because on that he has to pay income tax. No. Right? Now, what he will tell, because if my revenue increases, my profit also increases. I don't want to show that revenue. So, Naveen offers me a deal saying, I will supply the packaging material, sir, but without invoice. Clear? And you make the payment in cash. Alright? Now, I will tell, okay, you know why? Why will I say okay? Now, for me, there is no issue of GST. Correct or not? Now, I will make payment in cash and I will take that particular supply. Now, I will pay the cash, I will purchase it. My question to you, when I pay the cash and purchase, will I have an invoice for this? When I pay cash to Naveen and take the goods, will I have an invoice for this? He is not giving me invoice, I will not have invoice. But I will record that purchases in my books of accounts. Because my revenue should match with purchases. No? How can you say my revenue is more but my purchase is not there? Not possible. Yes. Now in this case, imagine I am your client. How will you deal with me? Now I will tell, sir, my vendor never gives me invoice and I pay it in cash. Complication. Risk is more. If risk is high, evaluate. Now you have identified a risk. Now you evaluate where all this will affect. This can affect my trading account. Yes. Now you have included in the purchases. Good thing you have done it. But now question is, where is the proof for that? There is no evidence for that. So how can I trust that this is the actual purchases? It can be a fake purchase also. Yes. Now for that I will go and take external confirmation. Now you think Naveen will answer to a CA? If a CA goes to Naveen and says, did you make cash sales to Karthik sir? Now he'll tell yes to him. Mad or what? He'll tell, who is Karthik sir? I don't know. Now this is the risk that we have identified. Once you identify the risk, you have to evaluate that risk. Once you evaluate whether it is a high risk or low risk, based on that, assume what all can go wrong. What can go wrong? Now this what can go wrong only in SA 520 analytical procedures we have seen. Factors affecting analytical procedure. Last point, what can go wrong? Inherent risk. Now what can go wrong? Purchases is wrong. Therefore, direct expenses can be wrong. Therefore, GP can be wrong. Therefore, NP can be wrong.
capital can be wrong, revenue cannot be checked properly, creditors can be wrong. Now look at the effect, pervasive or non-pervasive now? Pervasive. Understood? So it will affect many places now. That means I have to put procedures everywhere now. Therefore, I need to put better procedures, more procedures, time required will be more. So once you identify, evaluate, then relate to what all can go wrong, then consider the likelihood, because here you will get the entire list of possibilities. Clear? A list of what? Possibilities. Now sit with that list and see what possibilities are highly likely to happen. So the probability of high risk, answer that first. Or put the solution for those risks first. The possibility of risk that is happening very less, we can put the procedures at the end. Understood? Clear? So I need to first identify, evaluate, assume possibilities. Whichever possibility is high, I have to address that risk. Because we are saying address the risk, address the risk, address the risk. Which risk I should address? I should address the highest risk first. Understood? Clear? But do not change the process here. This is a process. First we identify, then we evaluate, then we assume, and then we act. Okay? Yes. RAP, procedure performed to obtain understanding. Is understanding the entity a one-time process or continuous process? It's a continuous process. It's not a one-time process. They say it's a dynamic and iterative process, just like our planning. Clear? Continuous and dynamic process of gathering information, updating information, and analyzing information. Therefore, we understand the entity. Now, what do you mean by understanding? Getting more information about entity, gathering. Once we gather, we update our knowledge about it. Once we update our knowledge, then we analyze and see how risky that particular new information is. Okay. Now, this understanding helps to plan the audit and exercise judgment. This is where planning is not a one-time process. Because risk assessment is not one-time process. Planning also cannot be one-time. Because my information changes and the plan based on this information also should change. Now you tell me, if plan changes, will my strategy change? Yes. Therefore, everything is continuous for me. Clear? Now if plan, no. If plan changes, should my procedure change? If plan changes, should my procedure change? Definitely, because what is plan? Nature, timing, extent of procedures planned. So when plan only changes, my procedure also will automatically change. Okay? This understanding acts as a reference point. Very important question. Why do we need to have an understanding, sir? This understanding will help you in deciding 5 things. What is the risk involved? What is important for the users of that organization? Clear? For example, for a bank, NPA is important. Yes, for some other company, profit is important. For some other company, net worth is important. What is important, I will understand. Clear? Third, identify areas where special attention is required. Some might be involved in more of RPT. Therefore, those transactions are important. Some organization might be involved in cash transaction. Therefore, more attention be given to cash transaction. Somewhere employees authorization is given beyond what is required. Therefore, unauthorized transaction will be many. Only when I understand the entity, I'll be able to solve their problem. Boss, simple logic. To solve the problem, you should know the problem. And to know the problem, I should understand them. Clear? Without understanding, I can never know, and without knowing the problem, I can never solve the problem. Then, developing expectations in AP. Remember, I told you that I will expect something based on the data that you give, and that expectation I will develop an accuracy, and then I will compare whether my expectation and reality is matching or not. That expectation from where will I develop? When I understand the entity. Without understanding, you cannot do anything. Next, evaluating AE to conclude as SAAE. Whether audit evidence is sufficient and appropriate depends upon the organization. If for example, I had one client, wonderful client, I have never seen such a authentic client ever. Okay, books of account, even rounding of expenses will match. For that also he has maintained a ledger. Clear? Now, if that fellow has that level of integrity, whatever evidence he says, can I trust it? Yes, therefore, whatever evidence he gives can be a sai for me. On the other hand, if the client is a liar,
Now, whatever evidence he gives, can I trust it? No, I need more evidence. So, whether an AE is I or not, that understanding also you will get only when you understand the entity. Clear? Very good 4 to 5 mark question I can ask here. Remember, what it will help in 5 things: risk, materiality, areas, and expectation, and evaluating the result. Okay? Yes, sir. Next, what is the understanding needed to obtain, sir? You said understand. No, what I have to understand? Number 1, relevant factors. Clear? Now, if you want, remember this here, take Mari. Okay, M for materiality. Okay, A for, sorry, not this. Areas, R for risk assessment, and E for expectation, and E for evaluation of evidence, or evidence evaluation you can write. Clear? So, understanding the entity will help me in getting to know Mari. Clear? Materiality, areas, risk, EE, evidence and expectation. Okay. What understanding I should have? Number 1 I should have is factors. So relevant factors including AFRF. What factors, sir? Industry factors. You think automobile industry and medical industry have the same factors? Definitely not. Banking industry and sugar industry, same factors? No. So understand industry factors. Regulatory factors. RBI is regulated by RBI cannot be. Can somebody regulate RBI? No. But RBI forms part of government, right? Okay. Who regulates RBI? No one. But RBI regulates whom? Banks. SEBI regulates whom? Which companies? Generally listed companies. IRDA regulates insurance. So our client, if we have a regulator requirements also we should understand before we put up the procedures in real life. Then external factors like government, competition, employee, all these other factors will come under external factors. Then nature of entity I should understand. What type of business are you doing? Trading, service sector, manufacturing, where all your operations are there. What is your ownership? Are you a government owned company? Private owned company? Clear? Sponsored company? Who you are? Governance structure. In ITC report I had shown you who is TCWG, who is management, and who are the other. I want to know the governance structure. Then type of investments you are making and you are planning to make, because investment type will tell you what type of a person you are. Clear? Imagine you are someone who invests in a lot of technology. What type of person you are? You are a tech savvy person. You love tech. Clear? If you are a person like MS Dhoni who invests a lot of things in vehicles, that means you are a vehicle person. Your investment will tell you who you are. Yes. So if you are an investor who is investing in equity, that means you like to take risks. Clear? But if you are an investor who invests only in safe investment, that means you don't like to take risk. So that investment will tell you what type of an entity you are. Are you an aggressive investor or not? Then we have capital structure and how it is financed. Clear? Then selection and application of accounting policy, its appropriateness and its consistency. What type of accounting policy you have used? Depreciation method, inventory valuation, revenue recognition, etc. And how consistently have you put it? Next, entities, objectives, strategies, and business risk. What is every entity will have an objective. So what is their objective? To achieve that objective, what strategy you have put, and what business risks do you have? Business risk means what? Competition. How are you advertising? Clear? Do you know some of them in Bangalore? Classic example I tell you. I'll not name the company and all, not appropriate on the camera. Okay, in Bangalore, one particular startup made an advertisement in the city by introducing a new type of cab. Okay, specifically for couples. Okay, now when they gave that ad, what happened? Everyone started giving attention to them. Clear? And they said, we are coming up with this idea, so only couples can have their privacy. You need not bother about anything. Clear? And when they gave such an idea, no, everyone started, putting it on story, liking it, commenting on it. Now engagement they got. Then they said this was actually not the idea. We are a different startup. Pure marketing, that is. Clear? Just like who is that celebrity who told, she's dead. And then, everyone started putting RIP, RIP, RIP. And then suddenly she said, no, this is rumor. And then technically it was her only who planned that. Clear? So she said that he was dead. Clear? Everyone started spreading that news that today
she's dead, everyone started putting RIP and all, and suddenly one interview she told that no, this is rumors, I don't know who's spreading these rumors and all. Who's spreading it? She only did it just to get attention. Clear? So what will happen is, now this can go good also, this can go bad also. Clear? So that is nothing but a business risk that you guys are taking. So that I have to understand, because you know why I am understanding this. You are not studying audit entirely. That's why these points and all will not be understanding. We know because we have understood audit as a entirety here. Why these people will do this is, if we take that risk and imagine it goes south now, we have tremendous loss. To stay in the competition, entity can think of doing fraud. Right? Let's increase our revenue. Let's increase fake revenue. Let's increase fake purchases. Expenses we can increase. So when you start doing fraud always has a reason. Clear? You copied in the exam in your school days because you didn't like to fail. That's the reason why you were doing fraud. But if your parents were okay with you not scoring marks, no, you would have never copied there. You would have actually gotten your actual marks, because there is some pressure, some incentive, some opportunity to commit fraud. That's why you do it. And for that, understanding this objective, strategy and risk is very, very important. Then entities' financial performance, read their previous financial statements, right? Or interim, quarterly, last year, check and see how they have performed there, right? That is with respect to risk assessment procedure. Clear? Now we talk about internal control system. Now, right after this, probably they would have added essay 320 in your book. Clear? But I am doing internal control because we have to understand three things: entity, environment, and ICS. We have understood the entity and environment. Now we are talking about ICS. Clear? What is internal control system? It's a process designed, implemented, and maintained. Clear? So process which is designed, implemented, maintained by whom? TCWG, management, other personnel. Why? To provide assurance about entities' objectives. So putting up timetables, putting up attendance system, everything is internal control system. What is the entity objective? Reliability of FR, then efficiency and effectiveness of operation, safeguarding of asset, compliance of laws and regulations. So remember as ROCA. Clear? ROCA or CORA also you can remember. Clear? C for compliance, O for operation, R for reliability, and A for assets. Clear? So basically 4 objectives I have. It's not that only 4, I have more objectives also, but generally 4 objectives. F for reliability I should have, operation should be efficient and effective, compliance must be there, asset must be safeguarded. Apart from this, frauds and error also I should be able to prevent. Okay? Now what are the objectives? Transaction must be authorized. Transaction must be recorded in the correct amount, appropriate accounting period, and maintain accountability. What do you mean by that? Whatever transactions the companies are executing, it should not be unauthorized transaction, number 1. Number 2, correct account, correct amount. Debtor should go to debtor only. Debtor should not go to the creditor side. And amount, 1 lakh should be entered as 1 lakh only and not 10,000. For that, all systems must be put. Then it should be for correct accounting period. If you put it for next accounting period, the current year income, then obviously current year income will be understated, which is very, very wrong. Then maintain accountability of asset. Accountability means what? Hold people responsible for managing the assets. Assets should be safeguarded from unauthorized access. No one should be able to steal the asset, because this is nothing but prevention of fraud only. In fraud, you have one more type called misappropriation of asset in the SA 240. This is that particular fraud they are preventing. Benefits. What benefits we have? We will be able to identify potential misstatement type. Okay. Number 2, benefits. Identifying the factors that affect the ROMM. What contributes to ROMM? We will understand. Control risk. Do you remember? What is control risk? Risk that ICS cannot prevent, detect, or correct the errors. If ICS is weak, it will contribute to control risk. Therefore, AR will increase. Designing NTE of further procedures. If ICS is bad, I will have to do test of details more. Okay. Limitation, important. What limitation is there? ICS can give only reasonable assurance. It cannot give you absolute assurance. Then human judgment is there. Remember, wherever humans are involved, you will never be able to give 100%. Any result, it cannot be given 100%. That's exactly why in CA they will not give revaluation, because who's correcting it? Human beings. If systems they put no,
we will have better results. Clear? You start putting system correction like how you have in foundation for that MCQ. Yes. Now definitely, why are you getting good marks there? Why are you getting good marks? Now in foundation, which paper is MCQ for you? Quant and Eco, I think. Yes. Now imagine law also is MCQ. Law will never be tough anymore. You know why? Because you know that answer is there in 4. It cannot be the 5th one. In descriptive, no, the answer can be 5th also, can be 6th also. Clear? That is the logic of putting automated correction and human correction. That is the reason why you see in foundation, no, it is okay. You solve 10,000 questions, you will be very confident. But whereas in descriptive, you solve 10,000 questions. The next question you will still be having little more fear. Because we don't know who is going to correct and what type of answer he is expecting. You know, in MCQ, definitely it should be 1 out of the 4. Clear? It cannot be. You know that 75% of the answers are wrong there. You just have to tick mark the right answer. Whereas in descriptive, the right answer can be many. Which your right answer and his right answer should match. Number 1. Number 2, your assumption and his assumption should match. Clear? That is why whenever somebody comes and says, no, sir, this we can teach like this or this we can teach like this. First I see what type of a paper you are handling. If you are handling an MCQ paper and I am handling a descriptive paper, boss, your methodology and my methodology cannot be same. Clear? If it is MCQ, no, I just have to give you, I have to bombard you with questions. That's it. Clear? And I have to teach you shortcuts. Is concept more important there? No. Shortcuts are more important? Yes. In Inter, concept more important or shortcuts are more important? Shortcuts are more important, huh? Without concept, you go with shortcut. You will have to take a big circle now. Yes. So, different level has different type of judgment, sir. So, whenever human judgment is involved, no, system cannot work properly because you take wrong judgment and blame the system. Recently, ChatGPT changed its functioning. Yes, because it suggested one guy to commit suicide. Clear? Now you tell me, you are asking an AI. You have HI, human intelligence. You are asking an artificial intelligence, I feel sad, I need to die. What do I do? Now there is a program for that system. You feel sad, you don't feel like living, okay, die. Now you are blaming AI for that. Now my question, why do you ask that to AI? Are you getting my point? Like how for Chitti, you said, TV podra, you could have told, switch on the TV, no. You gave wrong command, he obeyed your command, now you are blaming robo. That is what even the scientist did. He went and told stab Vasikaran, he did stab. Boss, you gave an order, he followed the order. Right? Then he told, yeah, that's a mistake, no, you should not follow that, you should understand. They are not letting robo also to be a robo. They want robo to become human. That's where that fellow fell in love. If he was always a robo, he would have simply obeyed the order. Clear? Same logic. We change the system because we are humans. Right? Now, system, you ask AI now, tell me which stocks to buy out of in Indian stock market. It will never tell you. It will never tell you because tomorrow you will blame that system. It will never make decisions for you. For example, you click photo of and you take screenshot of someone. Clear? Let's say Facebook, YouTube, Instagram, WhatsApp. You click screenshot, put on ChatGPT and ask, who is this? It will never tell you. Clear? It will never tell you. It will tell that I am not trained to recognize face and tell you. Because it is easy. Tomorrow you will blame ChatGPT for that. That's why systems only are programmed in such a way that to not give you certain things. It is because of whom? Humans only. Limitation. We can't do anything now. Clear? Lack of understanding purpose. You don't know why system is there. But you want to breach it for fun. Clear? Purpose is not understood. Collusion among people. Technically, if you see, point number 2, 3, 4, 5. All are human beings related. Number 1, human judgment. Number 2, people don't understand the purpose. Number 3, collusion. Number 4, judgment of management. Clear? Now out of 6 points, no, 4 points are human being related. Now only you should know where the mistake is. The mistake is with the software or the people who execute that. People who execute that. Limitation in case of smaller entities, they cannot afford to have such a big ICS because you need lakhs and crores of
rupees for that, they are not going to invest. Which controls are relevant? Because in SA 450 we have seen, on in SA 265 also we will be reporting deficiency, and there only important ICS will be checking. Which factors are relevant, sir? 11 factors are there. Number 1, materiality. Only check the important ICS which affects your financial statements. Significance of the risk. So if the risk is very important, controls contributing that risk also is important. Next, entity size. If the size is bigger, ICS will be bigger. Therefore, I need to check more. Nature of business, organization and ownership. What type of business, depending upon that, ICS should be checked. Diversity. What is diversity means? Variety and complexity of operation. In multiple areas, you have multiple businesses. Everywhere ICS can be different. Therefore, I need to check, because one ICS cannot be used for everything else. Applicable legal and regulatory requirements. If law says you have to check this ICS, then I don't have any option. I have to go and check it out. Nature and complexity of the system. If the system is too complex, I have to check, because complex system is where risk of fraud is more. How control prevents, detects or corrects a misstatement? Does it individually control, or does it join with some other control to prevent? Meaning, does it have a direct effect or indirect effect on fraud or error? How much control the entity has over completeness and accuracy of information produced by the entity? This is what I told you. If ICS is stronger, I can trust the internal document, but if ICS is weaker, I cannot trust the internal document. ICS over safeguarding of assets, because assets are important part of balance sheet. I need to check that. Some statute or regulation may require you to comply on certain internal controls, which is nothing but our ICOFR. On ICOFR, R stands for what? In ICOFR, R stands for what? Reporting. Therefore, we should report on ICOFR. We have to give opinion on this. It is because of section 143(3). Clear? Because this section is asking us to give an opinion, we have to give an opinion on that. Now come to component of ICS. There are 5 components. Component number 1, environment. Now, this is from client's perspective, you should check. Now, what is environment, sir? What do you make control environment here? The organization should keep the environment proper. How? By developing a culture of honesty and ethical behavior. Clear? So, they should create an environment of honesty and ethical behavior. What is included in the environment, sir? Number 1, governance and management function. What does governance means? Decision making or policy making? Both. Decision also, policy also. Management function means what? Executive responsibility. In basics only we had seen who is TCWG and who is attitude, awareness and actions of TCWG and management. So how is their attitude? How is their awareness? How are they behaving when they get to know something in the organization? That will tell us whether ICS is good or bad. So how is that affecting ICS, sir? If management has a rude attitude, employees will not think twice before doing fraud. They will only be selfish now. They'll tell, that fellow is very rude to us, sir. Why we should be kind to him? We will do what we want. So fraud can happen in the company itself. Clear? Elements of environment. Now, for this point number 2, no, I'll tell you one particular example. In one of the CA firms, the boss was very rude. Boss, manager, everyone was rude. Clear? Now, one article decided to teach them a lesson. Okay, what that article did, it was the last day of articleship. Okay, after that, that article will never come. Last day of articleship, the article messed up the entire financial statements of a particular client in Excel, saved it. Deleted all older versions. Clear? Deleted certain formulas, certain links, saved, left. The balance sheet was yet to be filed. Okay, now when the Excel sheet is opening, now everywhere, hashtag ref question mark, hashtag value question mark. What has happened? Link is not there. And what that article did also, while entering the revenue, that article forgot simply skipped certain bills in recording the revenue, and the bill was taken. Now what you will do now? Who will get the notice? Client will get the notice. Client will blame whom? The firm. And firm means who? The boss. So client will leave whom now? The boss. Revenue loss for whom? Now this is error or fraud? Now when we go and do the audit, they lost revenue. Because of whom? The article. Now, it is neither an error nor a fraud. That has to do with your attitude. If you were good to that article would be going one step ahead and help you out. But you are not good to your people, so your people thought of betraying you. That is the point I am telling. If management is not good, the environment will not be good. If the environment is not good, you will not work properly. So your attitude, your actions will have a lot of impact on the internal control systems. Clear? Next, elements of environment. What elements must be there? Important question, hidden question. Right? 6 elements are there. There are the 7 elements are there. Number 1, communication and enforcement of value. Whatever value you have to communicate to your people, and you should ensure that they also follow that. Commitment to competence. Always appoint good, competent people in the organization. Don't left, right, center appoint the random person there. Clear? Next, TCWG participation. Their independence we should check. Their experience and stature we should check. Involvement we should check, and appropriateness of action. Sir, if TCWG is not involved, clear? If the TCWG is not involved, then it will be a very difficult problem, because if they are not monitoring, people will do whatever they want. Management philosophy and operating style. What you believe in is what we call as philosophy, and based on that philosophy, how you operate is what we call as operating style. Organizational structure. Who is there in what capacity? Who has what designation? Let me know. Then assignment of authority and responsibility, meaning which department comes under whom. That is called authority and responsibility. HR policies and practices. How you appoint people, how you develop their let's say competence, what is the policy of promotion, what is the policy of demotion, all these things we need to check. Second element is entities risk assessment procedure. So obtain understanding if the entity has a process for 4 things. Number 1, identifying business risk. Business risk is whose responsibility? Their responsibility. So first you have to identify, same logic. Identify, estimate, evaluate, deciding. Same thing is our RAP. Identify throughout the process, evaluate, assume what can go wrong, decide on the action. What we are doing, they should also do. Identify, estimate, evaluate on likelihood, and then decide the action. Clear? In the exam, humble request, see what they are asking. If they are asking your RAP, you should write these 4 points. Identify, evaluate, relate, and consider. Clear? But if they are asking with respect to management RAP, then you have to talk about identifying, estimating, evaluating, and deciding. Clear? 4 marks, don't lose. 2 RAPs can be asked. One is entity side of RAP, one is your RAP. Got it? Clear? Okay. This understanding will help you to identify ROMM. Third element is information systems. Obtain understanding of what information systems you are using, meaning what type of hardware, what type of software, what type of people, what type of data, what type of network. Clear? What types you are using. Business process. What do you mean by business process? Like I said, purchase has a cycle, sales has a cycle. So every cycle where all IS has been involved, you should understand. Then understand the following class of transaction which is important for financial statement, and this is what we call as SCOT. What is SCOT? Significant classes of transactions. So identify that first. Then understand what is the procedure to initiate the transaction, record the transaction, process the transaction, correct the transaction, and transfer the transaction to respective ledger. So these 2 things you have to understand first. Number 1, what is SCOT? Number 2, which process procedures to initiate, record, process, and correct. Then understand the records, related records supporting information on and specific account used to manage a transaction. How does your information system capture the events and condition? Example, subsequent events. This will help. SA 570, going concern, events and condition. This will help. F for process used to prepare financial statements. I told you what is financial reporting means. The way financial statements are presented and prepared, or prepared and presented. Understand from the entities IS. Controls around journal entries. Why journal entries controls we should check? Very simple. Sir, root level no. If root level is wrong, fruit level also will be wrong. Understood? So if root level is right, fruit level always be the right. Got it? Okay, sir. Now, how are you communicating the roles and responsibilities, sir? That also is important. Between whom? Two different people. Management and TCWG, how they are communicating? With respect to the organization and external parties, specifically whom? Regulators. How are you communicating it to them? So there are three people, TCWG, management and outsider. Between TCWG and management, how are you communicating? And between these both, the entire organization and external party, how are you communicating? With respect to communication, five things. Understand the roles and responsibilities of individuals involved. Who is responsible for what? Why? For, remember, written representation, SA 580. From whom will you take? You say management. Who in the management? 10-20 people will be there. Responsible for preparation and presentation of FS, and that is what here is. Individuals involved in ICOFR. Clear? Understanding relation of activities. Do you have a link between 2-3 activities? Is my activity linked to someone else? Try to understand the link there. Do you have policy? Like in the form of manuals, like user manual you have when you're buying a product, that will tell you in case of problems what to do, what are the steps to be involved, those. Open communication channels. What is open communication channels means? People in your organization should be able to come and communicate problems with you. Less structured for small entities. So if it is a less structured for small entities, why? Because they will not be able to afford such a huge ICS. So for them, structural ICS is very, very less. Third, now this is number 3. Number 4 comes under control activities and then comes monitoring. What is control activities? Understand only those activities related to A, B, C, D and their assertions. Sir, ICS may be 1000 area it might cover. I am not bothered about all areas. Which area I am covered? I am bothered about 2 areas. Number 1, ABCD. ABCD is nothing but financial statements and their assertions, the statements made. So basically only those control activities with respect to financial statements I should be more bothered about. Control activities are policies and procedures to ensure directives are carried out, meaning actual execution is what we are talking about here. Clear? Actual execution is what we are talking about. Which activities are relevant? Hidden question. Which activities are relevant? Those activities with respect to significant risk. Clear? Any control activities, any performance of control which is in the significant risky area, I need to go and test. Number 1. Number 2, with respect to those risks for which substantive procedure do not provide. This we have seen in the chart. TOC, when do we go and test? When there is an understanding, the expectation that TOC will perform good. Number 2, substantive procedures do not provide SAI. Same point here. Clear? Point number 1 and 2 is nothing but same point. If the risk is high, I need to test it. If there is no other option, I need to test it. Then relevant as per auditor's judgment. Then any other control activities which you feel is important. But fourth one says specifically as per CA, if any risk is a significant risk. Which risk is significant risk? Here you told no with respect to. Now what is this significant risk, sir? This significant risk means risk of fraud, right? Risk of significant development, meaning what? New amendment have happened, but the organization is outdated. Therefore, is there data relevant? No. Can there be non-compliance? Yes. Can the data be reliable? No. Clear. Complexity of transaction is a risk. Why? The more complex. Logic. Super example I'll give you. Now, honestly you have to answer. Accounts easy or not? In intermediate for you to handle? Yes. Compared to accounts law. Compared to accounts, what about law? Little tough. Okay. Now, compared to law, tax. Gone. Okay. Between law and tax, which is difficult? Tax. Between accounts and tax? Hands down, sir.
Account stands A for you, it's not A for apple. A for accounts. Clear? Between accounts and costing. Huh? No, there is 50-50. Some say costing, some say accounts. Between accounts and audit. Audit, anomaly, sir. It is an anomaly. Remove it from the population only. Clear? Now, accounts and FM. FM is difficult, huh? FM is? So, both are same. Accounts and SM. Accounts is easy. Now, if you see, hands down, out of 6 papers, around 4 to 5 papers won by accounts only. You know why? If audit was as easy as accounts, you would have not skipped it. Now imagine ICA gives you the option to skip accounts and 2 subjects, accounts, audit. You can skip these 2. Which one do you prefer to skip? Exactly. You know why? You know why? Because of complexity. Accounts does not have that complexity as audit. That's why you tend to skip. Clear? Now imagine I am a fraudster. I will do fraud in an easy manner or complex manner. If I do it in a complex manner, you are doing that audit. Will you skip that complex matter or you will skip easy matter? Tell me now, which one will you skip now? Easy matter will you skip or complex matter will you skip? Because you have limited time also, no?
Easy matter.
No. I am not talking about skipping means what? Which one will you go and test? Complex or easy? If you are saying complex, then you should study also audit, no? You skipped audit because it is complex. Yes, I gave you 2 options, accounts and audit. You said I will skip audit because it is complex. But in real audit, when you are doing, no, complex area is where fraud happens. Because the fraudster will think, if you can skip easy, you will not skip easy, you will finish off it easily. But if it is a complex transaction, no, you will tell, who will sit and understand that, leave it. Are you getting my point? That is exactly the reason why they do enter into a complex transaction to confuse you. Clear? If audit was as easy as accounts, no, you would never skip it. That would be your favorite subject. Yes or no? No problems. Because when you go to finals, no, that is when I will ask you again, which is your favorite subject? And for sure, you will have second thoughts about accounts. You will tell, okay, sir, wait, sir, I will think and tell you. Clear? Other subjects are also there. Clear? Because obviously now the level changes. So, if you are telling that this is important, this is easy for me, it is not easy for you. It is easy for you because it is important. Number 1. Number 2, it is important because it is easy for you. If it is complex, no, you tend to not give your time there. You said leave it as skipper. Clear? That chapter which is difficult for us, it is skip. YouTube ad, skip. Clear? Now 30 seconds YouTube ad. In 5 seconds, you will get that skip button. Correct? Will you watch for 30 seconds? No, sir. Same thing with some chapters in audit. You will try to study for 5 seconds. Didn't understand. Skip. Next chapter. Clear? Like that, skip, entire subject only skipped. One more skip, attempt is gone. Clear? Now, why? Because it is complex. So, complex transactions is where fraud can happen. We have to be alert in those areas. So, any activity around complex transaction in ICS is placed, that ICS I should go and check. Transactions with RP, always risky, sir. Always risky. Because you can do fraud easily there because 2 people know each other. Subjectivity degree where measurement uncertainty. What do you mean by measurement uncertainty exists? Estimates, provisions, budgets, these all are based on assumptions. So their risk is always high. So ICS placed there also will be checked. Transactions outside normal course of, what is the outside normal course of business? Sir, remember D and F are not same. D and F are not same. What is D? Transactions with RP. Sir, my business is to teach. I am teaching, one of the client of my classes is my RP. That is transactions with RP. F1, I can do transaction with stranger, but it is outside normal course of business. Imagine my business is to give coaching classes and I am also having a business with someone else by lending money. That lending money is outside normal course of business. That I can do with RP also.
I can do with strangers also. But transaction with RP means the normal business only I am doing with RP. Understood? Two different points. Okay, sir. Now, these items are always and always risky. Which are those items? Non-routine transaction and judgmental transaction. Why? Non-routine means non-recurring, which doesn't generally occur or happen. Which are those? Number one, management specifying accounting treatment. If management comes and tells you how to account for it, no, that is a non-routine transaction. You are there to do business and decision making. Why are you coming and telling, don't pass this entry, pass it like this? That means you have done some fraud there. Clear? Manual intervention in data collection and processing. Here there could be a possibility of you deleting certain data and then processing it. Therefore, manual collection is always non-routine and risky. Complex calculation of accounting principles, estimates, very, very risky. Salvage value. You know, in depreciation, SLM, what is the formula? SLM formula. Depreciation. Accounts, A for accounts. This pencil will kill you now. Value of asset minus scrap value divided by number of which years? Useful life or economic life? Useful life, no? Pakka, no? Okay. Tell me, account is your favorite. So let me ask one question. How do you get that scrap value? Given in the question, sir. It is given in the question, we'll take it. Clear? How do you get that scrap value? Isn't that an assumption you're taking? Isn't that an assumption you're taking? Okay, now tell me. Today I purchase an asset. Okay, I am depreciating on SLM method. Now you know why WDV is better. Okay, SLM method I take. Scrap value of that particular asset today I have take. How much? Practically. And this is the interview question I will ask you. How do you take scrap value now? That's the point now. Sir, in problems, question will tell you what is the scrap value and you straight away you take calculator, every year depreciation, tuck, you will tell. Clear? Now, if I practically ask you, cost you get to know because you have purchased it. Economic life in company schedule 2 only has given you what you can take. Range is given, you can take within that particular range. Scrap value, sir, leave sir, 0. On what basis you're telling 0? Leave, sir. Don't want, sir. We'll go for WDV, sir. In WDV, you don't have to reduce the scrap value. Yes or no? It keeps on reducing. Now, scrap value, if you actually see, we can take a method saying today if I have purchased a car and if I say the useful life of the car is 7 years, after 7 years, what is the value of the car? I should assume it today. And how am I going to assume it? Do I know what is the value of the car after 7 years? No, because you know time value of money. Yes. So now the best estimate I will take is today if I have to purchase a car which is 7 years old, how much will I pay today or how much will market pay today? That is nothing but your scrap value is what you will tell. If I take it at a scrap value, today if I have to purchase that car or today if the car is scrapped, how much value is available in the market, that value only I will take. That's again an assumption, no? That is exactly why you see later on in some of your problems, scrap value changes. Number of years changes. And it will be called as an accounting estimate because the factor of the depreciation is changing. Clear? So those things we need to assume that. Now that is the reason why WDV serves as the best method for us. Clear? No, does that mean SLM is wrong? SLM is not wrong. Just that SLM has to have certain elements which we have to take. So those are little complex calculations, sir, where we can, it is not a routine transaction, it is a non-routine calculation. Therefore, we need to be little careful that it is a risky transaction. Because you know why? If I increase the scrap value, what will happen? If I increase the scrap value, what will happen? Depreciation will be reduced. Profit will be increased. I can attract investors now. I have good profits. What did I do? Nothing I did. My revenue is still the same. Clear? Right? My revenue is still the same. I just adjusted with the complex calculation, which is very difficult to find for you. Okay? Transaction are such that ICS cannot be placed. See, system can be placed only on routine transaction. Because you have to define the system. No, if you are not defining the system, the rule, how can the system go and flag it? Defining only is difficult. In those cases, I can't do anything. Now, judgmental matters. Accounting principles, estimate, revenue recognition is all based on what? Interpretation, again a risky area. Subjective, complex or assumptions about future, again a risky area. These are very, very important from exam perspective. Do not leave it out. Clear? Right? Okay, sir. Now, let's talk more about internal control system techniques. Right here. ICS techniques. Page number. Any idea? 50. Here. 57. Evaluation of ICS. Evaluation of ICS. Now, as an auditor, when I evaluate ICS, what benefits I will be having out of this particular evaluation? Benefit number 1, errors and frauds can be located easily. Whether I'll get to know whether ICS is in use and operating as planned by the management. Hey, having ICS and using it, one and the same? No, having ICS and using are not the same. Just because you have ICS doesn't mean you are using it. So I have to go and check whether ICS is there as well as it is being used. Clear? Effective IEAD, internal audit, is there or not? Why admin control? Is there any admin control that has a bearing on my work? For example, I am not supposed to go and check HR's problem. But if HR is appointing dummy people, then it will have a problem on my salary. Clear? Therefore, I should go and check whether HR is appointing properly or not. HR system I should go and check. Generally, I will not check HR system. Then, whether controls adequately safeguard the asset, because that's the objective, whether it has been doing it or not. How far and how adequately management is discharging the function, how reliable the reports are, extent and depth of the examination, how much examination I should do. That depends on ICS effectiveness. If ICS is very good, then my extent will be reduced. If ICS is bad, my extent will be more. What would be appropriate technique and procedure in the given circumstances? What areas where control is weak and where control is excessive, so that I can balance it out. Imagine in department control is more and department 2 control is less. I can take some controls from department 1 and put in department 2, so that balancing will be done in the departments. Whether can I give some suggestions to the management or not. Formulate the program after understanding ICS. That means, see, they have done chapter 2, then they have told chapter 3. Now, if you remember chapter 3, when we do audit program, or rather planning, strategy and program, everything has to be covered, they told. Without understanding ICS, can you put up a program? No. Therefore, formulate the program after understanding the ICS. Okay. Now, methods to evaluate ICS. First methodology is narrative records. Keyword to understand: complete and exhaustive description. Right? Exhaustive means what? 100% description is given. Now, in this case, what are the disadvantages? Understanding will be difficult. Identification is difficult. Incorporating changes or making changes is difficult. What is the checklist? Checklist, again keyword, series of instructions or questions. So here, remember in checklist, two things will be there. Instructions also can be there. Questions also can be there. What is so important about this, sir? Read the next one. Comprehensive series of questions. The difference between checklist and ICQ is, in ICQ only questions, in checklist both instructions as well as questions. Okay. Now, checklist, when he completes instruction, he initials the space against the instruction, meaning just put one initial. Answer generally will be yes, no or not applicable. In case of checklist, I will not do anything. I will just prepare and give. Who should follow that? My staff, article or anyone. ICQ, only questions will be there. Clear? With the proper questionnaire, if you want, you can complete all at once or you can do it in installments also. No problem.
Generally, the answer is yes, no, or not applicable. This is important. Questionnaire is given to the client and he is requested to get it filled by the employees. Basically, I will not do it. I will prepare and give it to you. Clear? If on a perusal of the answer, what does perusal means? Studying. If on studying the answers, inconsistencies and apparent incongruities are noticed, the matter must be discussed with the staff. Clear? Client and staff should sit and discuss. Then I will prepare a report called report of deficiencies and submit it to the management. Flow chart, graphical presentation of each part of the company's ICS, most concise way of recording, minimizes the amount of narrative explanation and thereby achieves consideration or presentation not possible in any other form. Okay, gives bird's eye view, and also I will be studying the important features of the business. Only after that I can put up the flow chart. One of the best methods of evaluation. Okay, which is the worst method out among the four? Narrative, because they are very difficult to identify and make changes. Okay, but one more thing, narrative record, it is more suited for small business rather than large business, because large business, so many things I can't put and sit in the record. It is better if I put only one or two. Okay, next, testing. In case of testing of internal control, there is nothing but TOC, which in SA 330 we have covered. What is the method of testing, sir? You can do inspection, inquiry, reperformance and observation. Remember, RAP is IO. RAP is IO, whereas in case of TOC, it is RIO. Reperformance, inspection, inquiry and observation. What is missing? Analytical procedure. That is only for what control you will analyze. Yeah. Last year control was like this year control is like this. What is the output of that? Nothing. So in TOC, AP we cannot apply. Okay. Next, testing of internal control operating on specific computerized application. That means we are using computer and making the audit. Basically, CATs we can use, computer aided audit techniques. Multiple techniques are there like snapshot, hooks and other things and all. We can use that system, and SCARF file is there. So many things are there. We can use that system and get to know. Okay. Now come to the main part of your internal control, which was a chapter before, audit in an automated environment. Here important things what will be covering. Question number 1, what are the features? Question number 2, what understanding you should have. Question number 3, what risks you should have. Very, very important. What risks we should consider. Clear? Question number 4, types of control. 2 types of general and application. Question number 5, testing methods. What type of methods we have to use. Question number 6, difference between manual elements and automated, where we have to use. Okay. Question number 7, where data analytics can be helpful for us. And question number 8, assessment and reporting audit findings. Let's talk about it. First question, what is automated environment, sir? Automated environment is, it refers to a business environment where PODA is done by computer systems. What is PODA? Processes, operation, decision and accounting. Everything is done by whom? Computer systems is what we call as automated environment. Clear? Where client is digital. Clear? Everything he is using technology. For what? PODA. P for process, O for operation, D for decision and A for accounting. Everywhere he uses what? Softwares or technology. What are the key features of such environment? Business operations will be faster. There will be accuracy. Processing large volumes of transaction. Integration between, what is integration? Means connection between 2-3 different departments. Better security and controls. Less prone to human errors, connectivity and capability provides latest information. Clear? Right, sir. Key features. Then, understanding and documenting automated environment. What we should understand and what we should document. Number one, which are the type of systems you are using? Like I said, in information systems, we have hardware, software, information, data, and network. So we need to see what type of hardware you're using, software you're using, network you're using, etc. Their purpose, why are you using this particular hardware? We need to understand that. Location of IT systems, is it locally situated or globally situated? What type of architecture you are using? What does architecture means? Design of the tech. Is it cloud based? Is it client server based? Is it desktop based? What type of it is? Clear? Now, for example, if you purchase ArivuPro classes, ArivuPro classes you are accessing through app. So their architecture is app based architecture for you, right? And also desktop based. On desktop also you can watch it. But do you have to download the different software, then install one, then put one pen drive, then install more software? No, this is not like that, sir. You directly log into the app and start watching, right? So their design is different. Version, what type of version you are using? Interfaces with systems. What is interface with systems? User interface, application interface. So what type of interface you are using? In-house versus package, meaning did you only develop the software or did you purchase from outside? Okay, banks generally have in-house software. Clear? Most of the entities will have packaged software. Then outsourced activities. What is outsourced activities? For example, did you give this service? For example, I purchase the computers and keep. Who does the repairs and maintenance? A third party. Now, when he does repairs and maintenance of your computer, don't you think the data can be compromised? Yes, it's a huge risk for me. Now, for example, okay, in-house versus package example. Now, see here. If we go to, heard about Zoho company? Yes. Now, if you go to Zoho, no, they will give you so many products for use. See here, Zoho point of sale, domains, payments, clear? Now, if I go, I don't want recent launches, I want everything else. See, CRM plus, service plus, clear? Apps. Sales app, CRM, begin, route IQ, sign, POS, marketing, see so many things are there. Services, so many things are there. HR you want, so many things are there. Legal you want, this is there. Security, business analytics, clear? Project management. Now all these are given by whom? Zoho. So when we are purchasing their software and using it in our academy or our organization or our company, our client, wherever he is using, that is called as an packaged software. In-house means what? You appoint the software engineer and tell exactly what you want. He designs and gives. It is like buying an apartment versus constructing one house. Clear? Then key persons. Who are the key persons here? CIO is Chief Information Officer. CISO is Chief Information Security Officer. Then what are the risks arising from use of IT, sir? First risk, inaccurate processing of data, processing inaccurate data, or both. Sir, what do you mean by inaccurate processing of data? Data is correct, process is wrong. Processing inaccurate data is process is correct, data is wrong, or it could be both. Unauthorized access is a big risk. Directing data changes, meaning what? Backend changes. Database only you change. Very good, sir. If database is changed, every decision also will start changing. Then, excessive access or privileged access. Did you give access more access to some person? Did you give less access to some person? You know why? When the person gets promoted, he should get more access. When the person gets demoted, he will get less access. Okay? Lack of adequate segregation of duties, unauthorized changes to systems or programs, failure to make necessary changes to systems or programs, and therefore we can also have loss of data. Mark this as a very important question. Clear? Extremely important question in every level of IT subject. Okay? What risk will be facing from use of IT systems? Now, this risk will impact where, sir? Number one, impact on
Substantive audit. What do you mean by substantive? Detailing. Whenever we want to go and test the details, we will not be able to rely. Why? If the system is wrong, the data that system gives also will be wrong. Therefore, I may not be able to rely on the data, and because of this, everything I have to test thoroughly. What is thoroughly? Completely. What is the point of system then? System should ease my pressure. It is increasing my pressure. More evidence is needed for completeness and accuracy. Impact on controls. Obviously, I won't be able to rely on any other controls now because system is processing wrong things. How can I trust the output of that? Like I said, input process is equal to input also is not right means output is not right. Process also is not good means how can I trust you? Therefore, again, I have to thoroughly test everything. Impact on reporting. I have to communicate to TCWG under SA 265. Remember, communicating deficiencies in ICS. Yes. Due to the regulatory requirement, I should give report on IFCFR, that is internal financial control with respect to financial reporting. What are the types of controls we have? General controls we have and application controls we have. Now, what do you mean by general control? Remember this particular sentence. Clear? General IT controls that maintain integrity of the information and security of the data. What do you mean by integrity of the data?
Honestness, genuinity.
The authenticity of the data. Clear? Authenticity means what? The originality. It should not be altered. It should not be tampered. Right? Now imagine from your particular, let's say, organization, you are an accountant. You are a CEO. Now in your system, for example, in your system, there is a software. That software should give you the data, how much sales was done in today. That is every day. Now, let's say every day they report. At the end of the day, 6 o'clock, they will report how much sales they have done. Now, the sales department has a software. The salesperson should key in the sales information there. From that software, it is integrated to your software. So, what will happen? That software will throw the data to you, your system, and you will be able to see. Okay, this is the process. Where what risk is there? Salesperson has to enter in the system. System will record that, throw the data to your system. You will get it in your system. What risk is there here?
He may enter wrong.
He may enter wrong information. So how do I curb that? Sir, sales should be entirely system based. One product comes, scan the QR or barcode, automatically sales should happen there. You just have to make the payment, give the change. The person should not be able to enter the sales. The moment sales is recorded there, two things. One, the sale POS should give information to inventory, saying inventory is reduced. Then one information should be given to CEO system so that this is the sales done. Clear? And then one system you should be giving it to the accounts department saying this is the sales done. So the moment sales is recorded, in three places it should be reflected. Where? Inventory, accounts and CEO. This should happen together. This should happen what? Together. Now, when I am talking about integrity of information, the inventory department is getting information from sales. Accounts department is getting information from sales. CEO is getting information from sales. Now, this information, imagine 10,000 sales I have done. When it is going to the CEO, it should go as 10,000 only. It should not be able to tamper in between, make it 1,000 and then give it. That should not be there. Clear? That is why in some of the systems you see, once you enter a data, you cannot change that. While entering only, proper entry has to be done. So such type of controls you should put so that the data's integrity and data security should not be able to compromise. Understood? Okay. Right. For that, where all we can use general controls, sir, data center we can use. Program change, wherever if you want to change your systems, there you can use general controls. Access security, don't give random security to people. And application system acquisition, development and maintenance. Meaning, here this point talks about controls for two activities. Number one, purchase of system, development of system. In case of
both will also have maintenance. Clear? In both areas, we should have controls. Acquisition also control we should have, meaning what? Randomly we should not, acquire a system. Proper quotation should be given. Ask the relevant companies to come and give the presentation, then approve formally, then project initiation, then start constructing, then data conversion, all those things. Proper procedure must be followed. Okay. Now this was asked in May 25 for 5 marks. One of the most easiest question that they can ask. Nothing but in column B you have to write which control it is. Clear? If you see access security, it is there in one of the 4. Therefore, this will form part of general control. Sequence number check is not following in all those 4. First, solve the easy ones. Okay. Data center and network operation falls under general controls. Now, the rest too is not there. You can consider this as application control. Whatever is we are only going to general control and application for this 5 marks. Clear? Now you tell me, is it worth? Is it worth? Definitely not. But if they have told one thing, mention the types of controls. So just mention 2 types of controls and then tell these are general controls and these are application controls. Clear? Application controls are what, sir? They are included in the IT system. For example, to give one example, everyone has laptops. When you open a laptop, Windows will ask for a password. Yes or no? Yes or no?
Yes.
That is operating system security. When you download a WhatsApp, a software on web-based WhatsApp, now there also if you want you can put a security. That is called app-based security. In your phone also, when you switch on the phone, it will ask for a password, fingerprint, etc. But respective app also has OTP and your fingerprint, Face ID, all these are MPIN, password, these all are app-based security. That is called application controls. Clear? Then we have IT dependent controls. What is IT dependent controls? The person in the organization is dependent on data given by IT. Now, data given by IT is wrong. The decision made by me also will be wrong. Therefore, first I should check whether IT is good or not. Clear? IT dependent controls basically are manual controls that make use of some form of data or information or report produced from IT systems and applications. So basically, human beings using the systems for decision making is what we call as IT dependent controls. So humans depending on IT. Humans depending on IT is what we call as IT dependent controls. On these kutti points, MCQ they will ask and kill you. And you don't know from where they are asking. Clear? Now, what are the testing methods? 4 methods are there. Like I said, in TOC, in RAP it is IO, TOC, REO. R, reperformance, inquiry, inspection and observation. Now, look at the puzzle here. Inquiry is most efficient, saves a lot of time, but also gives least evidence. Clear? Whereas, reperformance is most effective, gets best evidence. Which should I perform? Now, look at the next one. However, which audit test to use is a matter of professional judgment. I already gave you a hint today. We'll give you everything. What to cook out of it is your choice. It's like giving you ingredients. Master Chef and all you would have seen. All participants will get same ingredients. But how different participants cook different dish based on the judgment. What is best out of that ingredient is totally your call, and they are the one who will get the award there. Same logic here. They will tell you, see, Pa, this is least evidence that can give you, but most effective, efficient, time saving. But reperformance is not technically time saving because we'll have to perform the same thing again, but gives you best evidence. Now, what will you do? It is your call. Now, I'll tell you, writing practice gives you best effective method. Clear? But Summa reading is also efficient, saves a lot of time, but doesn't give you best confidence. Best confidence is given where? Now, which one to apply? Your call. So, what if I was in your place? Okay, sir, wherever for me topics are difficult, I will use writing method. Wherever I can put mnemonic and remember or any story and remember, I will use reading methodology. It is your call. Whereas if you say, I had a student who wrote the entire textbook on a note, For him that was more effective. He used that, but he did it from day one only. Therefore, it was useful for him. So whichever is useful for you, you go ahead with what the standard or the chapter says. Got the idea? Don't jump into conclusion saying, this is good, we'll do this. You have to say, okay, both the options are there. Let me use wherever I can use it. Okay, it depends on several factors. Now comes my favorite killer question. This is an unexpected and surprise question, bonus question. Now, which is effective method? Dash is effective method in automated environment. Dash is efficient method in automated environment. Inquiry. Now the question is, keeping both in mind, it depends on several factors what combination I should use. Does that mean only two methods are there? Four methods. RIIO, reperformance, inquiry, inspection and observation. Now these four, out of these four I should choose the combination or solo. Depends on factors like risk assessment, point number 1. Point number 2, control environment. Point number 3, level of evidence required. Point number 4, history of misstatement. Point number 5, complexity. Point number 6, assertions. 4-mark question it is. Where will you ask this? God alone knows. If they ask in the exam, because everywhere factors are there, you don't know where what to do. Clear? So in this case, 6 factors are there. Depending upon that, I will use the Rio combination. Okay. Document the nature of test, what test you did. Clear? Applied along with the judgments in the audit file. Audit file, where did we see? SA 230. Remember, you came and asked me, SA 230 is not a one-stop shot, it is. Everywhere documentation is there. Clear? When testing in an automated environment, some of the more common methods, hidden question for 3 marks, this can be asked, okay? So what are the common methods? First one, obtaining an understanding as usual. Number 1, do a walkthrough. After that, after you understand, do a walkthrough. What does walkthrough means? Start till the end. One transaction you do properly. Clear? Observe how a user processes. What technique is this? Observation technique. Walkthrough is what technique? Reperformance technique. Then inspect the configuration defined. What does configuration means? Details. Understood? Clear? Now, you should assess the impact of IT risk and complexity in which the business operation take place and plan alternative audit procedures in order to rely. If you are not relying on it, do alternative procedures and go ahead with it. Okay. Now, first of all, where are the areas where I should use manual element and where are the areas I should use automated element? Where, sir? Number 1. Manual elements may be more suitable where there is large, unusual, non-recurring transaction, because defining the systems will be difficult here. Circumstances where errors are difficult to define, anticipate or predict, not possible. Third, in changing circumstances that require a control response outside the scope of existing automated control, meaning what? Control can't do everything. To provide solution, who should do? Human beings only. IT can help you, these are the options. But which options to execute? We require humans. In monitoring the effectiveness of automated control. So in monitoring also we require people to be involved because system can't monitor everything. Which areas where manual elements may not be more suitable? First element, high volume recurring transaction, absolutely waste. If you are able to predict it, don't use manual, use systems. Activities where specific ways can be adequately designed and automated. Example, barcode for sales. In DMart, supermarket, wherever you go, you can actually design that. No, if you are able to define, design and sell it, good. Just scan it, sell it, scan it, sell it. That is more easier. I think I had given, I'll give the same example which I gave in the regular class. I don't know if I have given, I forgot. After that, multiple batches were done. Now, in Thailand, no. Thailand supermarkets have a system. Some of the supermarkets where you can pay cash, but the cashier will not accept it. the system will accept it. How does it work? Imagine I'm the cashier. You come and buy, right? Now I went to the supermarket and bought certain things. I was so fascinated by the system. I loved that system. Okay. How the system works is, imagine I'm the cashier. You are the customer. You will come to me. You will give me all the units. I will scan it. Okay. I have nothing to do just but scanning. I will scan it and I will tell you this much is the bill. Now, it depends upon you whether you want to pay cash or whether you want to pay card. Now, card, no problem. I can swipe and finish it off. The risk is very less. Where the risk is there? In cash. Now, there is a cash machine right in front of the billing machine, billing counter. Now, if you say cash, I will select cash. The machine will start. Once the machine starts, machine will open the slot. Right? It will show the bill. It will open the slot. You put the currency there, including coins. How much ever it is. Now, imagine it is 500. In India, let's put 500 rupees. Now, you don't have 500, you have 600. So, 200 ka 3 notes you have, you will put that in the system. The system will close the shutter. It will count. It will see how much you have given. You have to confirm that. Once you confirm that, system only will take it to the chest, convert that your change of 100 rupees and give it back to you. Again, shutter will open. You take the cash. My job as a cashier just to scan and give you the bill. That's it. I am not even touching the currency. Now, at the end of the day, the owner can come, put the password to the machinery, open the cash chest, take the cash, go. Isn't it more secure than the cashier handling the cash? Relatively, I'm talking. Definitely, yes. Yeah, I was so fascinated, I went and built once again. Just to wanted to see how it works. This time, it was not 100 rupees. I ensured that the products, let's say for example, you're buying a milkshake or you're buying a noodle, anything which is not 10 rupees, 20 rupees or something like that. Let's see if the coin, whether it will accept or not. It will definitely accept. I gave all the money that I had for that particular thing and it gave that change back. Now, even if you give more, it will come back to you only. So, therefore, there is no problem of the error where you give 500 and the cashier gives you back 500 by mistake. These possibilities you would have seen. Now you give 100, cashier is busy talking to someone, cashier automatically gives you 500 back. Now you will take that and go, no. Integrity. Right? You will take that and go. So who is losing now? Organization will be losing this. Therefore, in such cases, it is better you put automated rather than manual. Clear? Now, approach, only 4 steps in automated environment. First one, risk assessment. Second one, understand and evaluate. Third, testing. And fourth one, reporting. Clear? This is the only summary they have given. There is no steps technically where explanation is there. Go through it once before you go to the exam. Data analytics for audit. Easy question, important one. Sir, how does data analytics used in the audit language, sir? Very simple. I can use it in testing electronic records and data residing in IT systems. Imagine an Excel file is given to me where 10,000 entries are there. I should sit and manually check everyone. No, I can use data analytics. Clear? So where I can use its tools, checking completeness of the data and population. So I'll highlight checking completeness. Number 2, sample selection I can use. I showed you random number generator. In front of you only we did. Systems, that is recomputation of balances, re-performance of mathematical calculation, analysis of journal entries, fraud investigation, impact of control deficiency. These areas it will help us, sir. Tools can help you in these areas. What is the areas? Completeness checking, sample checking or selection of samples, recomputation, re-performance, analysis of fraud entries, fraud investigation, and evaluating the impact of control deficiency. 4 marks, easy question. In this, no, questions are straightforward. Clear? Very less you will be expecting case study questions here. Clear? More often than not, direct questions only they will ask. Digital audit means what? Sir, waste concept for you now. Reason being is it is just a 4-point. You have a chapter in the upcoming level. In CA final, you have a big chapter only of digital auditing. So for that, there is a starting point. For a big house, one stone they will put. This is a foundation stone. You think it is a stone and you will make a mistake there. Clear? Nothing. Digital audit means what? We using technology
to do the audit of our client. That's called digital audit or auditing digitally. Technical meaning of digital audit is different, where our client is using technology. If we go to that client and audit their business where technology is used, that is called digital auditing. Auditing digitally is nothing but where we are using technology to do our audit. Clear? Right. IFC as per regulatory requirements. Like I said, same ROCA will be there here, but one extra thing is prevention and detection of frauds. Then document the risk, whatever risk you have identified, document and keep it. Assess and report audit findings. What we should evaluate and report, sir. Number one, some of the points to be considered are as follows. Number one, are there any weaknesses in the IT control report? Number one. Number two, what is the impact of these weaknesses? Number three, report the deficiencies to management. And number four, communicate any significant deficiencies. Basically, SA 265. 265. These four can be asked. Okay. Then once you are able to do it, go and talk to TCWG and then ask them, are you going to correct these deficiencies or not? If you have corrected the deficiency, I will check again whether you have corrected or not. If not, I will go and report it. Understood? Clear? This is your automated environment concept. 315 audit risk and automated environment is done. We are left with only one topic in this particular chapter, that is SA 320, which is materiality. Clear? And after this, we'll have to finish off cooperative society and government audit. That is our priority. Once this is done, I will tell you how to think for other entities where you can actually think and write certain answers, which is absolutely valid. And for chapter 5, guide as to what is important to study there. Do not skip at least those basic concepts of chapter 5. Clear? Next standard, SA 320, which talks about materiality concept. Standard is very small, dedicated question, 1 or 2 max you can expect from this, that too very rarely, frequency. But the concept can be coming in any case. Okay, standard dedicated question, very less. This can be added as an add-on concept to any of the concept in the entire subject. What do you mean by materiality? Very simple logic. Materiality is that particular concept which is important. Now the question is, what is important and from whose perspective? Here you need to understand the point of view. Example, now when I am doing marathon or when I am doing regular class, what is important for me? If I do, that won't be right. So point of view is different. What is important for you? If I do, that also is wrong, because point of view is different. What is important from the exam perspective, I have to do. So the perspective differs. But when I am doing a regular class, the perspective also is a little different. I need to teach you what is important from the exam perspective as well as a little more practicality to understand the conceptual clarity there. So point of view is very important in materiality. Now there is the user who is important for us. There is a company who is also our client, and there is you. Now, when user has appointed you and go and do the audit of the company and give me a report, so I am representing whom? Users. Therefore, when I am testing the company here, I need to see what is important for me or what is important for user. What is important for user. Therefore, whenever we talk about materiality, we should always see what is important for a user. Now the question is, there are two types of users. One is called as general user and one is called as specific user. Now if specific user says this is what is important for me, then while auditing that we will see only that part of financial statements. But general users, when we see, generally for a user what is important? Profit, asset, growth, sales, inventory. These things are generally important. So point of view, again you have to see, is it a general user that I am talking about or special user? Special user or specific user is not there in your syllabus. Therefore, in this particular syllabus, you will be talking from whose point of view? General user's point of view. Is that understood? Point of view is understood. From general user's point of view is what we have to audit. Now, the problem is, general users will be too many. I am only one representative. So, when I am going and auditing, I should see generally for a group of wide range of users what is important and not just what is important for me. Although I have to take a judgment.
Now, when I take a judgment, I need to see for a general group of users what generally is applicable for. Then on their decision making, because they have to decide whether they have to put money in the company or not, that decision will be totally based on your audit report. So in that audit report, whatever I'm going to tell should be very, very important. So basically materiality's importance level or influencing level. For whom it is important? Users. So whatever is important for them will be important for me. Whatever is not important for them will not be important for me. What is important? Users' decision. Therefore, we need to see anything that affects their decision is what we call as materiality. Now, it is not always about the size of the amount. It is also could be a circumstances, meaning it all more generally we say amount wise it is important. Clear? If it is going beyond a particular limit, then it is important for us. If it is below a certified limit or a specific limit, then we will not be bothering about it. But when it comes to fraud, we will least be bothered about the amount. How big is the amount we will not see. Why did you make that and what is the reason for making that is very important. You might be doing wrong things in one or two aspects, but that one or two, what is the behavior of that? If it is a fraud, then the circumstance is more important than the amount of the fraud. Example, you cheat someone and take 10 rupees. Clear? Now, for example, general store. General store only you see, you go, you give 100 rupees. Imagine bill is 90. By mistake, that fellow gives you 50 rupees back. Clear? What will you do now? Huh? Really, what you will do? Practically, what will you do now? Won't you take that 50 and just come home? Huh? You will. But as and when you grow, you understand that. As a kid, we understand for us, we are getting that 40 extra rupees and we will keep it. But little more when you grow up, when you start getting that maturity, you will be like, no, even he is earning. Tomorrow, if somebody does that to me, I will feel very bad about it. Right? So let me give it back to him and let me get what I want. Clear? Now, in that case, no, behavior is what matters there. So your thought process is more important for you, whether it is 10 rupee or 20 rupee. We used to go to a bakery before and steal things because we used to go to swimming. We'll be very hungry while coming back from swimming. No, we have a gang. We used to go to a specific bakery and we used to steal a lot of these cans, my cans, Pepsi, my can, and other things. We used to steal and just come. Okay. Now, literally, once when we go, no, around 10-15 bottles we'll steal. Okay. Because we have a gang. Right. Now, there is a process for that. One person will go and talk to the owner. Clear. And another person will tell Adikolo, he'll be going and taking. By the time one person will take 2, 2, 3, 3 and come back. Clear. Now later on we understood that this is not who we are. Clear. Because we are doing it out of hunger, correct. Now is that the right thing to do? What we want, can we get it in a more legitimate manner rather than illegitimate manner? From there we used to go to a place where very nice chicken kebab we used to give. Go eat there without paying money, run and come. Clear. Now this is what we have done in our childhood. Clear. Those people have noted us. Today also they are talking to us only. Clear? But is there a legitimate way to do? Clear? Now, the question is, here it is not about whether it is one piece or one plate. It is about what? The behavioral aspect, the circumstances. Clear? So, in one of the cases, one of our friend got caught in the bakery. Clear? Because, the greed went beyond a level. Now, every day 2 tin is what you are supposed. Your quota is only 2 tins. Now, he said, if I can do 2, I can do 4. Now, when he did 4, he got caught. Clear? When he got caught, now obviously we started disowning him. Now, the bakery guys asked, he told, I am not alone, these people are there with me. I'm like, who are you? I don't know you. Thief, bloody thief. Just because you're alone, don't tag us along with you. And I told the bakery guy, you give it to police station from here 1 kilometer only, Call police. Clear, give it to them. And he's like, bro, what bro, don't do that. See, bro, hey, no bro, no sister and all. You have done wrong. All these days we have done, I have not done anything. See, don't blame me. Then panchayat and all happened. Then they allowed him to go home. Because small kid, school kid, they allowed him to go home. While coming home, this fellow is completely angry. He's like, what bro, we all did all together. Now suddenly you say, I'm like, that is professional ethics. Todil dharmam. How can I tell that we are all together? Then together we'll be going and counting math problem there in the station. So we can't do that. So that is where now they said, see boss, if you want, you ask, we will give, but don't steal now. That stealing is what we call a circumstance, which is nothing but a fraud only. Intentionally you are doing it. So fraud, lesser amount, fraud, bigger amount, does not matter. Fraud report.
Clear? Because fraud is important from user's perspective. So for them, will they like if you are doing any fraud? If yes, I am supposed to disclose it. Second example, going concern. See, going concern, if you remember SA 530, in that we have already discussed that if going concern is appropriate and material uncertainty exists, you are supposed to disclose. Now that disclosure, if you don't give, I will give modified opinion. Why should I give modified? Everything is correct. No. Sir, everything is correct, yes, but future it is not going to be right. No, sir, today only you should disclose. Now that is materiality concept where it is not about the amount, it is about the circumstances where you are supposed to disclose. You do not disclose, it is material and pervasive for me. That is why either qualified I give or adverse I give. If it is material and pervasive I give adverse. If it is material and non-pervasive I give qualified. Either way it is material only. Clear? So materiality is not always about the amount, it is also with respect to the circumstances. Now what is materiality generally? Anything that influences user's decision depends upon three things: circumstances, size and nature. It is not everything. Three factors are there, depends on three different factors. Common financial information needs of users as a group, meaning individually I can't address materiality needs. Clear? Individually I can't meet. For example, when I'm teaching a class, I have to teach the class and not individual students. So when I teach individual students now, then it is not right. If it is one-to-one tuition, then I can do individual teaching. But if it is one-to-many tuition, then I cannot do it individually. I have to focus as a group what is more important. But this materiality itself will give you a basis to determine what type of procedures, that is risk assessment procedures you should put, what type of further procedures you should put, and how are you going to assess the risk. If it is immaterial, even if it is risky, I will not bother about it. If it is material but risky, I will bother about it. Therefore, again, super concept. Determining materiality is what? Professional judgment. Now, for this only you have to understand the users. When I understand entity, environment and internal control, I'll automatically understand the users, what they want, and automatically whatever they want is important for my language in audit. Okay. Now, the most important question in SA 320 is this. Sir, you are telling what is important, what is important, what is important. Now, you are communicating it. No, there are four assumptions as a CA I am allowed to assume when I am giving my report. Four assumptions I can take. While taking the judgment, what is important, what is not important, you are allowed to assume about the users four things. Number one, they know to make reasonable decision. Meaning, whether you know or not, I don't care. I will assume you know how to make decision. For example, when I give you marathon classes, I will not be bothering whether you are studying or not. My job is to assume that you are studying. Clear? Whether you have studied or not, that is none of my business. I will assume that you have studied. That's an assumption, it is allowed for me. Because if I start taking one student, if I ask, did you study? Did you study? Did you study? If one student says yes, one says no, how can I teach now? So I will assume that anyone who comes to marathon or anyone who is watching marathon has done their studies. So anyone who is using my report or financial statements, they know how to make economic decisions. None of the financial statements, none of the audit report will help you out on how to make decisions. That is not done here. Second assumptions, I will take that user has a reasonable knowledge about business and economic activities to study the financial statement. So I will assume that you have knowledge. I'll assume that you have knowledge about business and economic activities. So I will not sit and give you the knowledge. I will never ask, do you know accounts? Do you know law? Do you know tax? I will assume that you have the knowledge if you are coming to audit classes. Technically, I am allowed to assume that because audit comes in group number 2. Now you started group 2, not my problem. That's an assumption which I am allowed to take because of the structure of the syllabus. Same logic here. Because of the industry, I am allowed to assume that an investor or a user knows about the company's business. So in my report, no, I will never introduce you to the company. If you read any report, no, it never introduces any company. Directly they will give their opinion. Clear? Financial statements also, if you see directly P&L and balance sheet is given. Clear? If you want to know about the company, go and read the annual report. Clear? There they will introduce you about the industry, about the company, etc. Financial statements and audit report will never give you the knowledge about the company. Which knowledge? Economic activities knowledge and business activity knowledge they will not give you. Financial knowledge they will give you. Okay. One more assumption I can tell is users understand that management has prepared the financial statement based on materiality. Meaning what? Sir, imagine you are coming to marathon and you're telling you are not covering 100% syllabus. What do you mean by marathon? Revision. Yes. Now, if you are telling that, no, go slow, 100% you have to cover slowly, then it is not marathon. Clear? So, when somebody is coming to marathon, I will take an assumption that you know that I am doing only important topics. Clear? Now, if I am covering 100%, good for you. If I am not covering 100% also, you can't complain because there is an assumption behind that saying only important topics revision we are going to do. Because what is the logic behind this assumption, sir? 100 or 100 plus hour syllabus, we are covering it in 20% time of it. That means only important things we have to cover. Imagine accounts, 180 hours of accounts of intermediate, if they have to finish in around 30% or 30 hours, meaning what? Not even 20%. Not even 20%. Yes or no? Now, for example, Sandesh sir has put a marathon. Yes, 33 hours is a marathon. Imagine 180 hours is the syllabus time. 180 into 20% is 36 hours. It is not even 20%, which means what? Only important topics can be covered. Sitting and solving each and every problem definitely will not be able to do. Now, that's an assumption which we take whenever whoever students come to marathon. That means they know that we are only doing it out of importance level. Same logic even CA can take. If a user is using audit report and financial statements, management has prepared the financial statements based on materiality and I have audited it based on materiality. Meaning all immaterial things we have not even bothered about it. There are immaterial things we have not bothered. Only because of these assumptions, what is my first objective of audit? Reasonable assurance about whether financial statements are free from material misstatements. Meaning immaterial misstatements will be there. Fourth assumption, users recognize that there are uncertainties while measuring the amount based on estimates, judgment and future events. I will assume that going concern is a futuristic assumption. We will assume that estimates, provision, budgets, estimates are with respect to future. Any judgments we have taken with respect to future. Here accuracy is not there. This we will assume that you know about it. So we will not sit and tell that provision is like this, like this, like this. I will not tell all those things. I will assume that you know what is provision. Clear? 4 marks, 4 points you have to write. What assumptions you can take? You can take that whether the users have knowledge about business. They can take economic decisions on their own. They have understood materiality concept and with respect to future. There are uncertainties in business. Okay. Now, talk about performance materiality. What do you mean by performance materiality? It is nothing but a sub-level of main materiality. Clear? Now we maintain something called as overall materiality, OM. Now what do you mean by overall materiality, sir? Imagine now a company which is already doing business. I understand the company, I understand the risk. Based on, I say, their balance sheet, their P&L, all misstatements put together should be maximum 10 lakhs. Clear? All put together should be maximum 10 lakhs. And when I do this saying it should be maximum 10 lakh and it should not be more than that. Now I keeping this in mind, this importance level in mind, I start doing my audit. Now imagine when I start doing my audit, first thing I will do is I'll pick the trading account. Now in trading account here opening stock is there. I check opening stock. No problems for me. Clear? Next I take purchases. Okay. Then I will tell the client give me all the purchases file. Now imagine he will give me the file of purchases. Okay. Now in purchases file there is 1 lakh invoices. Total in a year there is 1 lakh invoices. Now what I will do? Can I do all 1 lakh invoices? No, because I have other things also. I have direct wages, labor and other expenses, sales I have, closing stock I have. So I don't have enough time. So what I will do? I will take 1% of purchases as a sample. What is 1% here? 1000 I take. Correct or not? Now 1000 invoices I take and I start auditing them. Now let's say for example, first invoice I took, I got a misstatement. Okay. Imagine I got a misstatement of 3 lakhs. Observe and answer. Out of what is my sample size now? 1000. What is my population?
1 lakh.
1 lakh. This is my sample.
Now I started verifying my sample. First sample I got a misstatement of 3 lakhs. Compare this 3 lakh with 10 lakhs. Is it more or less? Less. So should I consider or ignore? Should I consider or ignore? Materiality means anything less than that we will ignore. Anything more than that we will start bothering about it. 3 lakh is more than 10 lakh or less than 10 lakh? Individually you tell me. Individually less. So should we ignore it? Yes, we will ignore it. Individually you tell me. Okay. So second invoice I started, no metal misstatement found for me. Therefore second invoice is good. Third invoice I did good. Fourth invoice I got another 2.5 lakhs misstatement. Individually you compare and tell me should I consider or ignore? Ignore. Similarly fifth I took, I didn't find anything. Sixth I took, I found misstatement. Now like that what I will do? Individually whatever misstatement I got, I compared with overall materiality misstatement and I started ignoring it. Now imagine, let's say fifth invoice no misstatement, seventh invoice whatever I had, seventh invoice had a misstatement of 4 lakhs. Now individually I should ignore. Now when I ignored 3 lakh, I ignored 2.5 lakh. Now I got 4 lakh. Now what is the total? 9.5 lakh. Is it closer to 10 lakh? Now 1000 is a sample size. In 1000 sample size, how many invoices I checked? Now in 7 invoices only it is coming to 9.5, which means we still have 993 invoices to go in purchases, then sales, then expense, then inventory. So many things are there. You think it will be below 1 lakh? The rest of the misstatement will be below 1 lakh? No sir, definitely it will be more. Now the question is, if I increase this, that means I am ignoring all these misstatements. My audit will be less effective. So what I will do, I will not change this. What I will do, I will put a new materiality limit. So I will tell purchases looks more risky for me because in 7 invoice only it is reaching to 9.5 and closer to 10. That means the risk is high. What I will do, I will put a new materiality limit for purchases. And this new materiality will be lesser than 10 lakhs. Clear? Generally, you take a percentage and take. So let us say, for example, I will take the new materiality for purchases will be 30% of OM. Now, what is 30% of OM? 10 lakh is OM. 30% of 10 lakh is 3 lakh. That means now I will tell, considering the risk in purchases alone, I will ignore anything below 3 lakhs and I will consider everything above 3 lakhs. Now, keeping that in mind, even equal to 3 lakhs, I will take into consideration. You tell me the first one is 3 lakhs. Should I take into consideration now? Yes. So I will audit them properly. I will not ignore them. So this is gone now. 2.5 will I ignore? Yes. 4 lakh will I ignore? No, I will consider. Now what is my total? 2.5 lakhs. Now you tell me, in future, I have still 993 invoices to check. In all 993 when I am checking, will I let it cross 3 lakh? No, I will keep checking and every time you touch 3 lakhs and above. So I'll keep checking. I'll never let you cross 3 lakh, which means when I'm not letting you cross 3 lakh, am I not maintaining a 7 lakh buffer for all other misstatements? Yes or no? 7 lakh buffer is for what? All other misstatements. Now, if you feel purchases are even high riskier, put this as a, rather than 3 lakh, put it if you want 1 lakh. Clear? Depending upon the risk involved now. If the risk is very less, I know misstatements are not there. It's okay. Even if I am keeping 8 lakhs as my new materiality, no, it will not cross because I know there are no misstatements. So, logically, performance materiality is that new materiality is what I call as PM. For every type of expenses or every type of income, depending upon the risk, I can have one other materiality limit so that I maintain a buffer. Like when you go for a trip. When you go for a trip, you decide on a budget. Right? Now, let's say for example, 10,000 is the budget you discussed. You said 10,000 budget and you started going on to a trip. Now, honestly tell me, forget about audit. In the trip when you are going, will you only carry 10,000 or extra 2-3,000? Why? Buffer, safety. That safety is what? Now, totally how much you have? 13,000 you have. But when you are telling your friends how much you will tell? 10,000. Why?
Because if I say 13, they will spend left, right, center. No, sir. That 3,000 is buffer in case of emergency. That is why the 10,000 now is performance materiality. Your overall budget is not 10, it is 13. But if I tell that purchases, no, my OM is 10, then sir, ignore me, no. But if I tell purchases, OM is only 1 for you. That means what? Anything less than 1, I will ignore. Anything equal to or more than 1, I will start testing more. I will not ignore them. I will consider them as my misstatement and I will report to management to correct it. Meaning, if PM is low, misstatement detection will be high. Therefore, your cleaning of materiality will be good. Cleaning of misstatements in the financial statement will be good. Otherwise, you keep on ignoring. Understood? Clear? What is PM? Performance materiality. It is nothing but a subset of OM only. PM can never be more than OM. Remember this relation. PM is always high. PM can never be OM. Logic. OM is always a percentage of PM. That doesn't mean you take 120% of PM. Understood? Clear? Sir, that doesn't also mean 100% of PM. Because if you put 100% of PM, there is no difference between OM and PM. Understood? Clear? Always remember, PM comes below OM. Which is highest? OM. Overall materiality. What is overall materiality? All materiality put together should not cross that much. PM depends upon the type of income or asset or financial item that you are testing. And PM totally depends upon the risk of that particular item. Clear? That is the entire concept of performance materiality. Depends upon the item that you want to test. If the item is high risky, your PM will maintain be very, very low. Like I said, if purchases is risky, I will maintain it at 1 lakh. If it is low risk, I can maintain high. If it is moderate risk, it is my call. If there is no risk, obtain high level of certainty to ignore. Sir, you only told risk cannot be eliminated. Correct. Risk cannot be eliminated. But in some cases, no, risk will not be there at all. For example, bank charges. Bank charges. What risk is there? Are you paying bank charges? Yes, you are only paying. Are you paying cash? Then how bank charges are done? Automatically debited to bank. Now there, don't you think risk is not there at all? Yes, because automatically it will be debited. There is no rule there. Clear? So there are certain things where there are no risk, but if it is no risk, no, high level of certainty you should have to ignore that particular amount or ignore the risk. Is that clear? Understood? Okay, sir. Now, OM, overall materiality of 10 lakhs. How did you get to know that 10 lakhs, sir? That depends upon one concept called as benchmark. Clear? Benchmark means what? Standards. Benchmark means nothing but what? Standards. At what standard I should keep that particular materiality. So how to determine this overall materiality? By using benchmark and applying a percentage of benchmark. Now, what is this benchmark or which percentage I should apply? Again, it is whose call? Professional judgment. What is important, what is not important? You take call. How much is important? Okay. Factors to identify benchmark. Elements of financial statement. Sir, what is important for investors in case of banks versus investors in case of automobile? What is important? Same thing will be important, huh? No. Sir, what is important for foundation and inter? Both are same? No, sir. What is important for inter audit and final audit? Both are same, huh? No, sir. Because even though same industry you are working in, levels are different. Similarly, same industry if you are working commerce industry only, but two different type of industry business you are maintaining. So we need to see of that particular business in financial statements what they focus more on. Some people focus more on profits. In some industries, it is not about profits. Clear? In some cases, it is not about assets. In some cases, it is about assets. So for banking, it is about NPA. For others, are you worried about bad debts? In Tata Motors and all, are you worried about bad debts? No. But in case of banks, you will be worried about bad debts. Clear? So there, bad debts is more important. So that is important for me to audit. Clear? Next, items on which users' attention is focused. Example, profits, sales, revenue, turnover. All these are nothing but sales, revenue, turnover is both are same. But when I say revenue, no, revenue from operations are different and total revenue will be different. So where are you focused on? Are you focused on revenue and profit? If yes, then that is more important for me. I'll take that only as an importance level. Then nature of entity. Sir, can I compare, can I have a benchmark? Can I compare your performance or can I set a importance level uh, of another industry? For example, you have scored 90% in your 10th and 12th. Let's assume that. Okay. Can I consider the same benchmark for CA for you? Why not? Now, if you score 40 in your school, you are a duffer. Yes or no? You score 50 in your school, you are below average student. You score 60, there is no respect at all. Yes, in CA, if you score 60, God level respect you get. Yes, exempt now all throughout the life in your school, if you have scored exemption, no respect. One paper you score exemption in CA Inter, God level, mad level respect they give you. Yes, so sir, then why it is different? Why there they say 60 is not good, here they say 60 is wonderful, here to get 40 people crawl. Yes or no? Months together study to get 40. Yes. Now Rashid sir, Akhilesh sir, Dilip sir, my wife, they studied months together to get 40 in audit. Yes, at final level. Clear? That is when they got the success there. They cleared because they got 40 in audit. Yes. Now there are people in school, college, you study for like 1 week, left, right, center, you score 90. Try that in CA. 1 week will end up only knowing what is the syllabus, not studying the syllabus. Yes, because the industry works differently here. Yes, so the nature of entity, syllabus is different. Yes, there they told state level board exam you write, after that life is set. 10th you wrote, life didn't get set. 12th you wrote, life still didn't get set. Clear? Now you are writing national level exam. Nobody is telling that. State level is bigger or national level is bigger? National level is bigger. Now, if you see two different entities, sir, I can't compare your marks with the CA foundation marks. Can I say in CA foundation you have scored, keep the same benchmark here? No, sir, not possible. Why? 4 papers are different, 6 papers are different. Yes, MCQs are different, descriptive is different. So I can't take the same option with you. So nature of entity and then sir, a service sector, for example, ArivuPro is in education services. That education services, can I compare with Tata Motors? No, because nature of entity is totally different. Life cycle of the entity. A company which is 100-year-old, can I take that benchmark for you? Can I say, see, now my mother used to compare me with a guy called Sudeep in school. Now that fellow scores 623 out of 625. Clear? Now such people you are comparing with me. Entire year if I total up, no, it will not come to 623. That fellow scores in one exam. Clear? Although he sits next to me only. Yes. Now, my mom always used to tell, he's sitting next to you only. Arivilla, you don't have sense or what? That fellow should learn something from him. My question is, I will learn. Will he learn something from me? It should be quid pro quo. Consideration, something in return. Now, you can't compare him to me. I asked my mom, can he play cricket like me? My mom is like, this is invalid question. I'm like, if you're comparing, compare everything. You have to compare everything. Yes. Now, if you are comparing his studies with me, now it's like, in that Yendiram they have executed that. Biryani sapta mudiyuma. Now, who are you comparing with? A robo and a human. A robo can't do it. A human beings can do it. Now, same logic, you are comparing an experienced, company in an industry which has seen all ups and downs. You are comparing with one startup that just started. And I'm telling the startup, see, for that company, they want so much profit you should also earn. In dreams, I will earn. Clear? So, when you're comparing, when you're setting a benchmark, you have to set a benchmark with similar features as close as possible. And do not compare yourself with a grown company. Clear? Then, industry and economic environment. Sir, state level economic environment will be different. Some state governments are supportive, some state governments are non-supportive. Some policies are favorable, some policies are unfavorable. Your industry is different, my industry is different. Clear? I will compare your studies with one UPSC aspirant. He studied 20 hours in a day, you can't study 20 hours in a day. Now, if that is a benchmark I'm setting, it is a wrong benchmark. Now, you will tell, because that fellow has to study whatever is there in the world and what is not there in the world also. We have to study only commerce at least. So, I need not put 20 hours in a day. Clear? So, when I'm comparing, the industry and economic environment also will be totally different. Ownership structure. What is ownership structure? Can I compare BSNL versus Jio? No, sir. BSNL is in coma since many years. Why? Government support, even if he is least bothered about competition. Everyone are running the race. This fellow opt out from the track. He's sitting and drinking fruity there. Not bothered. Why? Led by government. Will government let BSNL die? No. Whereas Jio, Airtel, people will kill. It will be out of the market, right? Now, in that particular environment, now I can't compare a government company with a non-government company, because non-government company has to get funds on their own, whereas government company, government will fund those. So I can't compare those two. Finance structure, a debt-oriented company cannot be compared with equity-oriented company, because two different companies are there. So I need to choose, benchmark a standard from that particular competitor, which is as close as possible to our industry, our environment. Clear? Now, in fact, I can't even compare the way I studied and the way you studied. Why? Because for us, the level of syllabus was different. For you, the level of syllabus is different. So, I can't really compare this, but I can still give you a little more inputs on it, so that you can now, in your case, I can compare your senior in your particular previous attempt and you, because syllabus is same. Yes, number of hours of classes will be same. Yes, question paper setting strategy will be same. Now, in those aspects, I can still compare and put a benchmark, because it is as close as possible. Clear? So, these are the elements. Remember, in life, no, if you want benchmark, if you don't have a benchmark, then there is no life. Meaning, we have to set a standard for ourselves so that we can reach that particular benchmark. Remember that mnemonic, NOLIFE square. Clear? Right. Next, sometimes a misstatement of lesser amount than materiality for a financial statement as a whole is material. When is that? Number 1, hidden question, 3 marks. Very good question. Clear? So, what factors indicate that misstatement of lesser amount is also important? Number 1, when whether AFRF affects users' expectation regarding disclosure. Example, going concern. Going concern is a classic example of disclosure. You don't disclose it. I don't care how big or how small is the amount. You come and tell me. You didn't tell. See, 6 o'clock you are supposed to reach home every day. One day you reached at 6:10. You didn't tell your mom. Will your mom panic? Of course, she will panic. She'll call 10 times in 10 minutes. Clear? Now, when you come home at 6:10, she will ask you, where did you go? And you will tell, I went out with friends. Can't you tell? Now you'll be like, 10 minutes? No, 10 minutes or 1 minute, that's not the question. You should tell. Disclosure, wherever disclosure is important, money amount or size of the amount doesn't matter. Number 2, disclosures with respect to industry. Sir, in that industry, expectation is only that much. For example, technically, I need not tell you when will I take the class. I can give break whenever I want. No. Yes. Now see, for example, Rashid sir, if his break methodology can be different, my break methodology can be different, Akhilesh sir's methodology can be different. Now, in the beginning only I told you that we'll be starting from this time to this time, and lunch break is from this to this, and in between break will be there. Yes. Now, I need not tell that. There is no point in telling. It is my choice, my class. I can give break whenever I want. But I believe it is a key disclosure for the students so that their mind will be set. Otherwise what will happen? I also know as a student, no. I have attended marathons. I have also attended regular classes. Now, 8:30 we start marathon. 10:30 you start looking at your watch. Clear? You will not tell me. But clear? And if I don't notice, you will ensure that I will notice. You will give me hints. Yes or no? Now, imagine I am ignoring 10:45. Okay? The watch sound will be even more. Right? 11 o'clock, I will still not be bothering. And you will start getting irritated. 11:15, then some can't wait. Sir, break, sir. Now, imagine I gave a break at 11:15 today. Tomorrow, I will still not tell what time is the break. Again, same. Now 10 o'clock only will start. Clear? 10, 15, 15 minutes. Now you will take turns. Yesterday I did. No, today I will not do. Sir will get angry. Someone else will do it. So now the question is, you are not focusing on the subject. You are here for revision. You all focus on that. You will focus on what? When is the break? Now imagine I don't have lunch break. Dead. 12:30 only will start. Clear? But if I tell you once, these are the disclosures that I am giving. Now day one only your mind is set. Okay. Sir will never leave us at 10:30. We will think about that only. Clear? Regular class students knows that. Yes, you know that break is at this point. Till then, you cannot even talk about the break. Once I tell, your mind is set. Once your mind is set, then you will work towards that only. Now 10:30 when I say 8:30 to 11 is if I say 11 o'clock only, you start looking at the watch. Yes or no? That for me it is a key disclosure because in my industry I believe it is a key disclosure. Like that, every industry there are key disclosures. Those disclosures should be given. Clear? If those disclosures you don't give, whether it is small amount or big amount does not matter. Investors will not like it. Clear? Focus on a specific aspect during major event like purchase of business or even demerger. Sir, demerger you have to disclose irrespective of whether it is a small demerger or big demerger. These are events. Sir, simple logic. You are getting married. Imagine you are just getting a registered marriage. Okay. Now registered marriage, 4-5 people only you will call and you will finish out the marriage. Now you didn't tell your best friend, will you get angry? Now you tell the best friend, hey, I didn't get married at a bigger level or smaller level. Married, no. You didn't invite me. I'll feel bad about it. So it doesn't matter how big is the event. If it is an event, it could be a major event. I am not talking about the amount included in the event. I am talking about the occurrence of the event. Amalgamate, every day you get married or what? No, amalgamation doesn't happen every day. Demerger doesn't happen every day. Clear? But in those major events, COVID and all those things, you are supposed to disclose it to the users, irrespective of the amount. Okay? Is materiality fixed, sir? No way. Materiality shall be revised as the audit progresses. As when is materiality fixed, sir? During strategy time. You go to the regular book, no, chapter 2, when we talk about is planning continuous process, there only we will say determine materiality. So first only we determine, after that only we keep on changing. Now, what is the revision for reasons for revision, sir? Circumstantial changes, situation changes, therefore I need to change. New information I got to know. Now imagine I got to know management was not fraud. So I ignored big amounts. I was only focused on bigger amounts. Clear? Now later on I got to know you are involved in fraud. I will be now focused even on small amounts. Clear? Changes in the understanding of entity and information. I understood the entity differently. Now I am understanding it differently. Therefore, changes will happen there. If overall materiality has to be changed, even PM has to be changed. Why? You have to evaluate that should I change my PM or not. Generally, I told you PM is equal to percentage of OM. So if OM changes, should I change my PM or no? It is not a mandatory thing. I can keep PM at the same level. Imagine OM is 10 lakh. I have kept PM as 3 lakh. I change OM 10 to 20 lakhs. That does not mean I have to change PM. If I want to change, I can change. If I don't want to change, I need not change. MCQ they can ask, is changing PM mandatory if OM changes? Answer is no. Auditor should evaluate. If required, you can change. If not required, you need not change. Finally, documenting the materiality. Maintain documentation. Which materiality? OM. Right? For each ABCD, PM and changes in the materiality. Everything has to be documented under SA 230. Got it? Clear? Yes, this is the entire concept of SA 320, materiality. With this, chapter 3 is done. Let's move on to cooperative society audit.
RMM ಜಾಸ್ತಿ ಆದ materiality
RMM
Param is higher.
Uh,
Will materiality level be low?
no. Materiality level, which materiality level you're talking about?
Amount or
OM or PM?
OM.
Okay. OM will definitely be low. But depends. ROMM at what level you're talking. Because ROMM, not every level will be high. Clear. Now, if ROMM, when I say, there will be two ROMM on financial statement level and assertion level. Financial statement level is called OM. Assertion level, we put PM. Okay, so ROMM means in every level you should see whether it is high or low. That's why I give you that matrix. If it is high, then it will be low. If it is low, if risk is low, it will be high. OM or PM both will be. Okay. All standard topics are done. Clear? From now it's only on your other special audits. Clear? So technically, without these also you can score good marks. But these are easy marks that you can score. Okay? Chapter 5 also you can score easy marks. But the problem is what they will ask from where. That is a big question. Clear? And too many points to remember, forget writing. Remembrance only the problem there. Right. Let's talk about cooperative society audit. Like I said, this chapter plus bank audit put together is what you get. The marks. Okay, 10 to 15 marks is what they say. What do you mean by cooperative, sir? It's an association of persons. AOP it is. Clear? Why? Because they meet voluntarily to ensure their common needs are met. I am saying again, it is not wants, it is what? Needs. Common needs are met. So basically, like-minded people come together and form a society. Hey, forget cooperative society. What do you mean by the word society? You say, no, we live in a society. What is that society? Group of people having like-minded thing, like mindset. Same mindset everyone has. That's why they say this society is good, this society is different, that society is. Society is nothing but AOP, association of persons for common thought process. Example. Let us say all fishermen coming together and ensuring that the fishes which they sell, they should get proper rate in the market for that. This will help in eliminating the middleman commission and brokerage. Farmers, producers. Producers means he's not film producers I'm talking about. Clear? I'm talking about agricultural produce. Clear? Like that goldsmith people, right? Everyone forms a society, sets the rules among themselves, and they say we will not sell below this price. Right? Now, if they say that AOP coming together and forming a society for what? Needs. They have to follow it. Everyone will have to follow that. Clear? Which act is taken care here? Cooperative Society Act 1912, which is a central act. Clear? It is nothing but a central act, but many states have their own state act which they have to follow, but central act only says follow your state act in certain things. But that doesn't mean I will not tell you what to do. I will still tell you what to do. In many states, they have specific state acts. Cooperative society is what? Business organization. Meaning what, sir? Business organization means what? For example, in Goa, if you go, do you know that in Goa, Ola Uber is not allowed? In Goa, Ola Uber is not allowed. Clear? They'll throw you out of the market. Big fight has happened there. There, only local taxis you have to take. You don't have any other option. Clear? Their Ola Uber presence only is not there. The entire taxi drivers association union has banned. You're not supposed to do business there. Clear? Why? Because it's a tourist place. So because of you, our local drivers are getting affected. But the local drivers charge bomb to travel in Goa. So the best possible method in Goa is self-drive. Either self-drive or two-wheeler. Clear? Per day 450, 500 rupees is what you get a two-wheeler for. Put the petrol, keep on roaming around. Because there, I traveled once from railway station to our hotel. Generally it is around 15 kilometers. 15 kilometers, how much they can take if you take your own car. Now, for example, 1 liter can give you around 16 kilometers per liter if you see. That means in 100 rupees you can reach there. Now, if you say rent also per kilometer, let's say 5 rupees per kilometer if they are charging, 75 rupees is a rent. Basically, in 200 rupees you can reach. They charge 3,000 rupees, 2,000 rupees and all. You want to buy. Otherwise, go walking. Now, there is no Ola Uber. What you will do now? You will have to take that. And imagine alone you are going. You're not going to Goa, you're going to Singapore. That much money will spend and come. Clear? So what generally we do is we take our own car or go there. Clear? With friends we go so that we can share the money and take two-wheeler on rent. Two-wheeler is much cheaper than these cabs. Clear? And they throw a lot of tantrums and attitude. You have to bear that. Now they are an association, but if that does a business, no, it becomes a cooperative society now. Association doesn't have any business motive. Cooperative society has business motive. So business organization with a special mode of doing business by pulling together all the means of production cooperatively, elimination of middlemen and exploitation of outside forces. See, it is actually a good thing only. A farmer who is producing potatoes and other things and all. No, imagine 1 kilo in the market, 100 rupees it is available. He will get only 10 rupees. Or he will get only 20 rupees. Majority of the chunk is eaten by whom? The middlemen. So if you eliminate them, what will do? In city, cooperative members will come and install a stall. Cooperative society stall. Clear? Which generally we say hopcoms and other things. Now there, the produce directly will come from the farmers. Now sell in the market at 100. Clear? Farmers also will get good rate. Now you tell me, will they go for this or will they go for middleman commission? They'll go for cooperative society only. Should the society get audited? The answer is yes. Who will audit? The registrar. Which registrar is this? ROCS. That is Registrar of Cooperative Society and not Registrar of Companies. Okay. He will audit. Now, at least once in a year audit must be done. Who will audit? He will only appoint someone. Either he will appoint you or some other person as a auditor. Right. Now this audit should include overdue debts as well as valuation. Sir, he can use special order or general order. Okay. Now, what should be the qualification? Important. Who can be the CA? Number one, a chartered accountant within the meaning of CA Act 1949. Meaning what, sir? You only. You and me. We can become a CA. If not, this is one entity where without a chartered accountancy degree, you can still become an auditor. Provided you have government diploma in cooperative accounts. If you have this, then even though you are not a CA, you can become an auditor. A person who has served as an auditor in the cooperative department of government to act as an auditor. Meaning what, sir? They are trying to tell here, either CA or government diploma holder or the one who has already worked as a auditor of any government entity. Now the question is, why did they have these things, sir? Because cooperative society generally CAs won't take it up. Clear? Because of, obviously, the vitamin M is little low, but the efforts required to finish off that audit is high. State acts you have to know, central act you have to know. So many things are there, so they don't prefer to take up such audits. That doesn't mean audit should stop. If you are not doing, someone else should be there. That someone else only these two people are. But if it is a multi-state cooperative society, then a CA only must audit. This is single state what we are studying. Clear? Later on we will be studying multi-state. There, a CA only must do the audit and not someone else. Okay. Appointment. Who will appoint? Registrar of Cooperative Society will appoint. What you should do? You should do the audit, prepare a report, submit the report to him. Who will pay the fees, sir? Society. Who will fix the fees? Registrar. Remember, who will pay the fees? Society. Who will fix the fees? Registrar. Who will appoint the CA? Registrar. He has to submit the report to whom? Registrar only. Here. There in ITC and all we had seen the report is given to members and all. Here the report is not given to members. The report is given to ROCS because who appointed me? That fellow. Who wanted the report? That fellow. That fellow will give the report to that fellow and not to the members of society. Registrar will forward it to the society. But my job is to give it to registrar. Books. What books they can keep? Any books you can keep. All the only formula they say is you keep any book, but it should disclose full financial results. Any type of books you keep, no problem. Depending upon the nature and object, you keep your books. Restriction on shareholdings. What is the maximum share a particular member can hold in cooperative society? There is a restriction. Max to max 20% of total number or value of shareholding up to 1000 rupees. Clear? Now, look at this logic. Other than a registered society, meaning a registered society can hold n number of shares, no problem. But an individual or anyone else other than registered society, if you want to hold a share, how much is allowed?
Maximum 20% of what? Total number of shares or value 1000 rupees. It should not exceed this. Why, sir? To accommodate more people. See, I have only 10 laddus. Now, if I say one person can take any number of laddus, one person will come and eat all 10. No? What's the point? My point is to give it to many people. So, if as many people as possible, if I am supposed to give, should I give big chunk or small chunk? Small chunk. So, small chunk will ensure more people will come and ensure the benefit of society. We should watch that particular limit. Next, restriction on loan. Can they give loan to anyone else? No, you cannot make loan to any person other than member. But with special sanction, society can make loan to another registered society. Okay. Number B. State government may put further restriction. As of now, central government has told that you cannot make loan to outsiders. If you are making loan, only to your member is allowed without sanction. With sanction, society. Restriction on borrowing. Can I take money from others? Definitely yes. You can accept loans and deposit from persons who are not the members. Now, whatever money has been received in society, where I should put the money? Anywhere. For all this formula, no, only one word you remember or one phrase you remember. Anywhere where my money is safe. Where will be my money safe? Huh? Bank, government, that's it. Clear? Now, in equity, when I put it is not safe. See here, banks are there. Share, security, bonds, debentures of other society. Society to society, we trust each other. Clear? Any other bank or government funds. Government bonds, ZCB and all is there. Now, you buy that and enjoy your money. Clear? Just that money should be safe. You know why? Our business is not to earn interest and profit out of investments. Our business is to sell our produce. Clear? Then, what we should check next one? Appropriation of profits. Meaning, should we transfer to reserves? Yes, a prescribed percentage of the profits should be transferred. Now they have told 25%. Clear? Tomorrow, registrar can change this. But even if he is changing this, it should not be less than 10%. That means minimum to minimum, 10% transfer should be there. Right now, how much they have told? 25%. Sir, can I donate money? Yes, definitely. You can contribute an amount not exceeding 10% of net profit remaining after compulsory transfer to reserve fund. Clear? Then, investment of reserve fund outside the business or utilization as working capital. Sir, whatever reserves is there, where can I use? You can bring it back to your own society as a working capital, no problem. Sir, can I lend this money to other society? Society to society, you can. Business of a society as working capital. Invest as per provisions of this act, basically banks and government securities. Clear? Then, for public purposes, you are likely to promote the object of the society. Meaning what? Your society's object you can improve. Okay? Contribution to education fund. Like how in income tax you pay cess. What cess you pay? Education, higher and secondary education as well as health and education cess you pay. Right? Now the question there is, why do you pay that? Compulsory, correct, because income tax has asked you to pay that. Yes, basically contribute to education, right? Where? Who asks? No one. Clear? Because nobody pays tax only in the first case, right? So they say, sir, you have to contribute to education fund. Clear? Same now, even the retail shops have started this. I don't know if you have observed. You go to a billing counter, they'll tell, sir, do you want to contribute to education fund? Education way, no? Clear? You have income tax takes sets, cooperative society takes sets, everywhere they take education says, you also. Clear? Right? So in those aspects, you can contribute, but at appropriate rates as per the class of the society. Who will set the class? CA will give the class. Then, next, special features. Important.
Sorry, fourth point. The 1,000 rupees is for face value.
Of course, face value. Because you tell me, can cooperative society get listed? Therefore, there is no market value. No. Okay. Alright. Examination of overdue debts. Now, what do I mean by overdue debts? See, very important, because cooperative society can give loan to their own members. Right? Who manages this? Managing committee. You give loan to all members, you should receive that money also. No. If you don't receive that money, it is an very important asset for us. Therefore, examination of overdue debts is a very important feature for us. So, segregate this overdue debts into 6 months to 5 years and more than 5 years, and then check whether provision is made properly or not. Clear? Then also check whether what are the chances of recovery, so that we should classify it as good debt or bad debts. If you are able to recover it properly, then you can consider it as good. Otherwise, it is bad. You have to write it off. Then overdue interest. Obviously, when the debt is overdue, the interest also will be overdue. It should be excluded from interest outstanding and accrued while calculating profit. Although it is our profit, we did not yet receive it. Okay. Then certification of bad debts. This is one special feature of cooperative society where you have to certify a debt as a bad if it is a bad debt. In normal business, you will never have a certification as such. Do you give certification? You don't give certification. In cooperative society alone, you have to certify the debt as bad. Only then write-off is possible. Write-off without certification is a crime for them. Crime, this is not criminal crime, but we will be reporting it to the authority. Next, verification of, now sir, who should certify? Either auditor or managing committee, one of them, not anyone else. Clear? Verification of assets and liabilities. Very simple logic. 3 questions and we are done with this concept. Tell me, if it is a fixed assets, what is the valuation principle? Cost minus accumulated depreciation or provision for depreciation. If it is current assets, cost or market value, whichever is lower. If it is liability, actual value, right? Known liability, actual value. Contingent liability keeps on changing. It's an estimate. Okay. Adherence to cooperative principle. What do you mean by adherence? Compliance with the cooperative principle. So every cooperative society should comply with the principles. We'll have to check. Like what, sir? Wastage of funds should not be there. Use your funds, but for people's welfare. Then they should also follow act and rules. Check that. Check financial implication, where all we can have effect. Okay. Right. Now, verification of members register and passbook. This is again a peculiar feature, different feature for cooperative society. What generally happens is, when people give loan to members, the members take loan. Now, I don't know whether the member knows about it or not, because you tell me in cooperative society, everyone are educated, huh? No. So, is there a possibility they can be fooled? Therefore, I said, who will fool? Managing committee only. So, I should go and check their passbook as to what they have done. Next is special report to the registrar. When do you give special report? When special events happen. Clear? Now, imagine you are a cooperative bank or society. A prime minister opening an FD in your society is important. Special or not? Yes, sir. Therefore, we'll have to give it under special report. What is PMFD? P for personal profiteering, M for mismanagement, F for fraud detection, and D for disproportionate advances. Now, what is one by one? Personal profiteering means what? In society, you have to take care of the group of people and not your own interest first. Now, if you do sales and you take the money and you invest in wherever you want, it's a personal profiteering. Clear? M for mismanagement. You did not follow the principles and law. You did whatever you want. Clear? Then, next. After that, F, detection of fraud. Fraud is always like you know, intentional. What type of fraud? Both financial fraud and asset related fraud. Okay. D, disproportionate advances to vested interest group. Meaning what, sir? This generally happens in urban cooperatives. Okay. Banks. Now in cooperative bank, what generally happens is, they will never give loan to outsiders. You should be a cooperative member. Only then they'll give a loan to you. Now, imagine we all are cooperative society, and let's say everyone are members except Hari. Now Hari is Lakshman's close friend. Lakshman is a member in cooperative society. Now what he will do, he will come to me and he will tell, sir, actually my friend wants loan. None of the banks are giving because of his little history with the bank. So can we give them loan, sir? I'm like, see, cooperative society means only for you I can give loan. Now what will Lakshman tell? He will tell, okay, then give me loan. Now I know for a reason loan is not for him. Now he will tell, sir, we'll do one thing, sir, we'll take care of you. Do one thing. He wants 10 lakh loan, give him 15 lakhs. Now, according to his credit worthiness, I can only give him 10, but I gave 15. Why? I'll tell Lakshman, okay, I'll give 15. Banks are charging 10%. Normally, we give loan to you at 6%. We will give loan to her at 10%. Now, you tell me, when he is not getting anywhere loan, will he be okay with this 10%? Definitely yes. Why? Banks are also giving it 10%. Sir also is giving it 10%. Let me take it. Now, I gave 15 lakh loan. He is eligible only for 10. I gave 15. Now, why did I give that? Because disproportionate advance, meaning the proportion is only 10. I gave 15 to vested interest group, meaning I have my interest in this. Now imagine actually I am a partner in Hari's business. Lakshman doesn't know that. So that's the reason why I gave more money, because I know how much is required there. So I have an interest in that particular group of business. Clear? Reckless advancing without evaluating the worthiness of the party. Reckless means what? Careless. Negligence. Whose money you are giving? Members' money you are giving. Clear? Next. Classification of society. Here is where you get the class. A class, B class, C class, like how you used to get in school, college. No, your school gets grade like that only. Here they will give the class. So we will give the class. Auditor shall award the class to the society. But if the society is not satisfied, you can appeal to the registrar. He will review the audit classification. Then, just like how in normal audit, before giving the report, we discuss it with TCWG. Here also, before giving the report, you have to discuss it with managing committee. Here TCWG is who? Managing committee. Because minor mistakes and all can be rectified. Distribution of profit. Can I distribute the profit, sir? Yes, no problem. But 25% should be transferred to reserve fund. Okay. Now talk about multi-state cooperative society. Now what do I mean by multi-state cooperative society? Presence of the society in more than one state. In this case, multi-state cooperative societies act is applicable, not single act. Now, what type of books of accounts they have to maintain? Same logic. This is very similar to company. Similar to company or Companies Act. What books of accounts they have to maintain, sir? Sales, purchases, asset liability, money received and money spent. Clear? And in case of production, manufacturing, processing, you have to maintain cost records also. Other terms of cost. What other books? Any books you want to maintain apart from this. Apart from this is optional for you, but these are very important books you have to maintain. Clear? Qualification. Who can do audit of multi-state? A chartered accountant only. Disqualification. You cannot appoint a company as your auditor. Number one. Number two, you cannot appoint the officer or employee of MSCOS. You cannot appoint partner or employee of officer or employee of MSCOS. Sir, what do you mean by that? Same as your section number 141, but I will not assume. Now imagine this is MSCOS. This is me, Karthik. Now, can MSCOS appoint Karthik, who is an employee of MSCOS? I'm a CA. Can I? No, because direct interest I will be biased. Now, I also have a business outside where I have a partner. Okay. Now, can you appoint this partner as CA? Still no. Why? This is direct interest, sir. This is indirect interest. We will not be able to appoint them. Then, if you are indebted to the society or guarantor to the society for more than 1 lakh, do not become an auditor, because again you have an interest there. Sorry, 1,000. 1 lakh is our company's. Clear? This is your 1,000 rupees. Appointment. Who will appoint, sir? First auditor, always by the board. Subsequent auditor at each AGM. Same as our section 139. Okay. If board fails in case of first auditor, then they will be appointing in general meeting. Meaning here, every year one auditor will be appointed or different auditor can be appointed. Sir, can we appoint the same guy? Yes. Here rotation and all is not applicable. That 5 years rule and all is not applicable anywhere. You can for any period, but every year he has to be appointed. Okay. Powers and duties same as section 143. Books of accounts, explanation, then any other information he wants, officer should cooperate. Clear?
he can go and ask anything. Inquiry, 4 matters he can inquire from, he should inquire from the management. Number 1, have you given any loans and advances in such a way that is affecting the society negatively, prejudicial to the interest of the society or members? I need to ask and report it here. Number 1. Number 2, transactions which are represented merely by book entries are not prejudicial to the interest, meaning we should check any book entries that you have passed. What do you mean by book entries? Entries where there is no actual transaction but requirement of law or our normal gap. Example, depreciation. It is a book entry. Do you actually spend money there? No. Provision for bad debts. Do you actually keep the money separately and sit? No. These all are what? Only book entries. And in such cases, if you are purchasing all these things, which you are spending money, that is fine. Those are not just book entries. Merely book entries means where transaction has actually not has happened, but you are just passing the entry. Closing entries are book entries. Ask whether personal expenses have been charged to revenue account. Where it is stated in the books and papers of MSCOS, any shares have been allotted for cash, whether cash has actually been received. If no cash is received, whether the positions stated in the books are correct, regular and not misleading. Clear? Okay, sir. Now talk about the report. You have to give report to whom? Members of MSCOS. Because who appoints you here? First alternate committee, that is board, if not members. Whereas in single state, who appoints you? Registrar. Therefore, submission will be to registrar. Here, who appoints you? Members. Therefore, submission will be for members. Okay. Right. That is one big difference between this one and that one. Then, special audit, very important. Special audit, very important. When will we do special audit, sir? Number 1, only in case of if central government or state government either alone or both holds 51% or more of paid up share capital in such MSCOA. So eligibility of special audit is only when government holds more than, not even equal. Yes or no? No, loose tools, 51% or more. Therefore, more than or equal to 51. Even if it is equal to 51 also, you have to get a special audit done or applicability is there. So, central government may direct either a CA or existing CA for the society only to make special audit and give a report to whom? Central government. Because who appoints here? Central government. Same logic. ROCS appoints, report to him. Members appoint, report to members. Government appoints, report to government. Here government means who? CAG, Comptroller and Auditor General. Okay. Now, when will CAG appoint, sir? In case of 3 scenarios. In case of 3 scenarios, he may appoint you. Number 1, affairs are not being conducted as per principle. Meaning, see, you have an affair, but do it according to the law. Clear? Meaning business. You have a cooperative society. You are eligible to do business. Do it, but it should be as per the principles of cooperative society. Then you are conducting the business in such a way that it will cause serious injury or damage to interest of trade or industry or business to which it pertains. Meaning what? You are doing business, but you are causing harm to the society, sir. Public interest. In case of public interest, I can take this action of special audit. Clear? Then financial position is such that it endangers its solvency. Meaning what? Potential insolvency. Potential insolvency. Clear? So right now it is not insolvent, but going forward it will be insolvent if you do like this only. Then on receipt of special audit report, CG may take such action as it considers necessary. None of your job, none of your business. Once you finish your report, get going. Clear? Now inquiry and next is inspection. Both are same. Points exactly same. Like only 2 differences are there. Understand the 2 differences and we're done. What are the 2 differences? Inquiry means seeking information. From whom? Knowledgeable persons.
Inspection means what? Checking the documents. This is difference number 1. Difference number 2, in inspection, we have to give report of inspection. In inquiry, there is nothing called report of inquiry. In inspection, we have to give report of inspection. Who should communicate? We should communicate to MSCOS within a period of 3 months from the date of completion. This is one difference. Clear? One difference is conceptual difference. Inquiry is questioning, inspection is checking documentation and verification, and in inspection we will be giving a report of inspection also within 3 months from the date of completion. CA should give it to MSCOS within 3 months. One report copy. Okay. Right. Now, CA should give or registrar should give, sir? Registrar should give. Which registrar now? Central registrar. Sir, who can apply then? That means a CA is not going to conduct the inspection here. Here you write central registrar, CR. Okay. So CR will conduct the inquiry, CR will conduct the inspection and give a report to MSCOS. We are not supposed to do anything here. Understood? It is between society and registrar. Right. Next, let's talk about government audit. What do you mean by government audit? Auditing the government. No. No. Auditing the government means who? Government department, government organization, government company, everything comes under government audit. Okay. Now here, government audit, it is not just with respect to money related audit. It can be rules related, clear? Number 1. Second one, it can be program related, efficiency related, economy related, everything comes under government audit. Now who does all these government audits, sir? CAG. Who is CAG? Comptroller and Auditor General. Clear? Now, appointment, who will appoint CAG? President of India shall appoint CAG. Removal or resignation, who will remove or when will be resigned? He can be removed only on 2 proven grounds, proven misbehavior or incapacity. Moreover, he can be removed only when each House of Parliament decides to do so by a majority of at least 2/3 of members present and voting. Meaning what, sir? You cannot remove him easily. Number 1. He doesn't represent any party. Number 2. Reason, who is appointing him? President. If I allow political parties to appoint him and remove him, then we can't trust CAG report also anymore. Clear? Number 1. Number 2. Number 3. Can he be removed, sir? Yes. On what grounds? Only on 2 grounds. It is not accused misbehavior. Proven. Prove that he misbehaved or he is incapable. Only then you will be able to remove. Sir, if I prove, can I remove him? No. Proving is a grounds for removal. What is the procedure for removing? 2/3 of members in both house, Lok Sabha as well as Rajya Sabha, upper house as well as lower house, you are supposed to pass a resolution there. How many should say yes? 2/3 present and voting. Whoever is there, among them 2/3 must be saying yes, only then we can remove him. Sir, can he resign whenever he wants? Yes, he can resign through a resignation letter addressed to President of India. Remuneration, what is this remuneration, sir? Salary equivalent to the judge of Supreme Court. Okay. Now, what is his duty? Compile and submitting the accounts to the department, auditing the receipts and spending, expenditure of government. Here, I wanted to note one thing. The note there, the body or authority shall be treated as substantially financed if the amount of grant or loan in 1 year is greater than 25 lakhs and 75% of total expenditure. Meaning what? For you to call it as substantially financed. Clear? What is the criteria? The amount whatever was given, if it is more than A, 25 lakhs plus 75% of total expenditure is handled by whom? Government. Clear? Now, the question is, 25% I have written. 25 lakhs. So, if the amount given to you is more than 25 lakhs and Out of your total expenditure, 75% of that expenditure is handled by whom? Government. In that case, we'll call you as what? Substantially financed government organization. Clear? To audit grants and loans, receipts of union or states. Here, union means what? Central. For central government, we say union here. Or for central department, we say union. To audit the stores and stock, rice, kerosene, wheat, flour, all these things will come under stores and stocks. To audit government companies and corporation, and finally to report and submit the accounts. What is the power I have? I can inspect any office, I can ask any question, I can ask any accounts, books, papers, documents, and I can call for information, whatever I want. Clear? I can't say no to him. Directions in case of company audit, government company audit. Government company audit. In case of government company, CAG shall direct the auditor in the manner in which the accounts of government company are required to be audited. Submit a copy to the COG. Who appoints us? Here, who appoints us? Government audit? CAG. Therefore, report submission to? Simple. Report, among other things, the directions given by CAG, actions taken and impact. Supplementary audit, important. Supplementary audit. CAG shall within 60 days of the receipt of original audit report, you can have a right to order for supplementary audit. What is that order? What is the main objective behind this? Supplementary audit. CAG may conduct supplementary audit. It shall be conducted by either such a person as CAG may authorize. Meaning what? He can appoint a new CA or he can appoint the old one related to the audit. Then CAG shall comment on the main audit report. They can comment on the supplementary report. Any comments or whatever given by the company shall be sent by the company to every person authorized for financial statement. See logic. I am CAG. You are the company. There are members. I conduct supplement audit of your organization, your company. The CA will do the audit. Give me a report. This report I will forward it to you. You have to give it to all the members. You cannot say, no, I will not give. You have to give it to all the members. Members should know what happened in your organization. Clear? Any comments or supplement shall also be placed before the members in the AGM. In the meeting also, if you want, you can keep. Now comes actual government audit. Expenditure audit, receipt audit, and stores and stocks inventory. Let's talk about expenditure first. Under expenditure, we have 5 types. Rules and orders, sanctions, provision of funds, propriety audit and performance audit. Clear? Meaning what, sir? Here, rules and order means what? Whether whatever rules are given to the department, are they following it or not? That is called rules and orders audit. Sanction means what? Whatever amount we have sanctioned, your spending should be not more than sanctioned amount. It should be either less than or equal to. Against provision of the fund means what? We create a provision and keep, not yet sanctioned. We just create a provision and keep. Your spending should be as per the provision and not more than that. Propriety audit means what? Although you have money, is spending required? So here in propriety audit is one of the most important audit, but very difficult to even prove that you are wrong. You know why? Reason being is, imagine logically you are allowed to spend every day 50,000 rupees. Okay? Every day you are allowed to spend 50,000 rupees. Where all you will spend? Every day 50,000 rupees is a limit. What all you will spend daily? Food, clothes. Every day. Now food level will increase. 5-star hotel only you want. You will go to Marriott, ITC. Yes, there all these places you will go. Then vehicle, a little bit installment you will be paying and getting one vehicle after every time. No. Now there will be one particular point where you will be asking, is it important? Like, is it required for me to purchase? Although I have a limits, but does that mean I should purchase? No, sir. Now, if it is someone else's money, no, you will purchase. Adarthama class. Clear? Right? Not our money. Someone else's money, you will definitely purchase. But if it is your own money, will you purchase? No, sir. It's okay. Roadside idli also is fine for us. Yeah. But if it is someone else is giving party, now you want it a posh place. Clear? You don't believe in filter coffee. You believe in cappuccino. Yeah. Where filter coffee and all you require? Don't want, sir. Party means you have to someone else's money. No. If it is your own money, then black coffee, not even milk. Clear? Why? My money. Why I should spend lavishly like that? Same logic we are asking government. Whose money you have? Public's money. How you should spend? Carefully. How we spend? Carelessly. Clear? How carelessly? Imagine there is a circle. Okay? In a city there is a circle. There is one road here, one road here, one road here, one road here. Traffic is flowing smoothly. No problem. Now you are a government there. Suddenly you say, no, something is wrong here. We will remove this circle. Clear? We will remove this circle. Now we will put a bigger circle. And one statue in between. What did you do? Nothing you did. Because of this, did efficiency increase? No. Did public safety increase? In fact, circle is bigger, therefore now traffic is more congested. Suddenly you are going to your own city after 2 months. Hey, here traffic was not there now before. Suddenly how traffic happened here? No. A lot of people have vehicles in 2 months. Suddenly some traffic will happen because some changes happened there. Clear? In our city, I had seen one particular place and I'm like, what nonsense project is this? This is a road. There is a road here. There is a road here. Okay. Now there is a school here. And there is a circle. Now what they have done is, they have removed this circle. Okay. School is there. They have removed this circle and nicely what they have done, they have removed this part of road here. And here this part of road they have removed, here this part of road they have removed, and here they have created one nonsense lawn, small. And here one lawn is there. And two-wheeler can go like this. I went there, here literally forget two-wheeler guy. The rickshaw is parked on the way. And the rickshaw guy is like, they didn't ask me that they are doing this. This is our rickshaw stand. Now, two-wheeler guy and three-wheeler guy, they are fighting. Here, nicely they have put one lawn on this. And one lamp for that. Street light is there. Circle is there. LEDs are there. Adhupur lamp. The only question was, what is the point? Clear? Absolutely no point. After some time, they removed this. My question to you, why the hell did you put it in the first place? Spend, no? Money is there. Public's money is there. Something we should tell public, no, we are doing something. Something we have done. Purpose you don't ask. Clear? In one more signal, very heart of the city, one clock tower they put. We don't have watch or what? Now you tell me, have you ever led your life looking at the clock tower of your city? No. Worst part, that clock tower doesn't even show time. Clear? It is showing nonsense time. And for that entire tower, no, laterite finish. Clear? Laterite is very expensive. One tile will cost 120, not one tile, 120 per square feet they charge. Laterite they have put. Correct. Super project. What is the point? No point. Right? Now, but they will never say no point. You know what? They will say, this increases the heritage of the city. This increases the beauty of the city. Correct. Super. I understand all these things. Clear? But if there was a purpose, it would have been better. Clear? In one more city I had seen, it's a length 5-kilometer road. A wonderful road it is. Clear? Left side of the road, they created one lane called bicycle lane. Only cyclist people will be running there. My question to you, I asked my brother, what is this for? He's like, bro, that's only for cyclists. I'm like, so many people are there. No, morning generally people keep cycling. So for their safety, they have created one separate lane for them. I'm like, good. Evening I went, right? Entire, now this is the road, okay? It's like this. Here they have created one lane, okay? How they have created the lane is, you know that plastic divider will come. They have kept there. In between that, two-wheelers have been parked. Now cyclists should either go like this or go here footpath or they have to fly and go. Purpose not served. The bus guy, wonderful. On that only he will go. That is plastic, no. On that plastic will go like this and then again stand like this. On that only they will go. Purpose. Sir, we will bring an idea. We will bring an idea, but it will fail. You spent money on what purposes? Money is spent, sir. It is told publicly that, boss, see, you have given that money, no, we have spent that money. As long as we are spending, that means you will be thinking, government is doing something. Clear? Okay, sir. We will do one thing. In the new area, there is no road. We will put one road. Clear? Nice concrete road will put or tar road will put. After putting the road, after 2 days, they will remember, oh, your drainage pipe we did not put. Take the road again. Clear? Then put drainage pipe. Then put one more road. Then we forgot, oh, earthing we did not give for the electricity. Then again dig the road. Clear? Then again put the road. Then we put 2 pipes instead of 3. Dig the road again. 2 pipe only. Put the road again. Now you spend all these things. You spend on what purpose? So there is no explanation given because there is no one asking. Clear? Propriety audit is nothing but where you spend money. But the question is it required to spend? Only if it is the need, then spend. Just because you have money, even within the rules and regulations, it is only if it is required you spend. Wisdom is very important there. Clear? So in propriety audit, I'll come back to this. In propriety audit, we will always see what? Wisdom, faithfulness and economy of the transaction. Public financial morality you should see. I understand if you create, let's say for example, a busy junction is there. There is no traffic signal at all there. Spend money on that and create a traffic signal there. It is good. Probably some congestion can be reduced and accidents can be reduced. No, sir. We will put zebra crossing where there is no traffic. Where people will not even cross the road. Clear? You see, Indians, except zebra crossing, no, they'll cross everywhere else. Clear? Random in the middle of the road, they'll cross. Clear? As if it is their road. And they'll ask you to stop also. They will shout at you even if the signal is green. Now, there is a divider. In some of the cities, no, there will be a divider of 3 feet. 3 feet, 3.5 feet. You can't even jump. Some people from this side, they run to that side, jump. Little 100 meters away, there is a zebra crossing. We will not go there. This side only we have to go. Clear? Then comes the ultra smart people. Midnight, someone will come. The divider will be there. Completely, there is no break. Someone will break the divider in between. Small gap for a human being to cross. Clear? Next day morning, you'll be saying, oh, this is there. Everyone will start crossing from there only. Clear? So even government knows that it is waste to give any development to our people, right? So when you are spending this, no, they spend lavishly or anything, we have to first ask, it is actually within the rules only. That's the point of proprietary. It's as per the existing rules. You can't say it is illegal, but it is highly wasteful. Clear? Not required. You have money. Does that mean you buy, 1 crore ka bag, handbag? Not required. Clear? If it is required, you buy. If it is not required, some people see it as an investment. That time, yes. Clear? Now, for example, let's say Sachin Tendulkar, MS Dhoni, they buy that 1 crore ka bag. Tomorrow, if they sell it also, no, they'll earn more than that. For them, it is an investment. Clear? So, whenever you have money, just because you have money doesn't mean you spend on lavish things. Clear? If it is required, you spend. With your money, you do that only, no. If others' money is there, buy, sir, whose father what goes? You buy. Clear? Your money, vana. If it is required, we will buy. Clear? There is no hard and fast rules. So here what we should check? Check that whether they have made the expenditure with the same degree of vigilance as an ordinary man would exercise. Number 2, it is not prima facie more than the occasion demands. So how much is required, you spend that much. No authority exercises its power of sanctioning expenditure to pass an order which directly or indirectly accrue to its own advantage. Meaning, as a government officer, you should not authorize anyone to spend money only on your benefit. Next, public money should not be used for benefit of particular person or section or community. Meaning what? If you're spending, spend, but not be only for one type of people or one person. It should not be for that. Clear? Right, sir. Next, come to normal one. Sanction rules and order. The name of this also is called regularity and legality. What is the objective? Ensure that expenditure is in accordance with 3 things. Provisions of the Constitution, then rules and regulations, orders and other rules. Remember these keywords. Okay. Next. In this connection, I should have sound knowledge. What does sound knowledge means? Thorough knowledge of what? Who is allowed to incur and who is allowed to spend. Number 1. Number 2. Mode of presentation of claims. Example, refund. Clear? Do you know this year, many people who have filed in the month of July, they got refund in the month of December. We are in December. People who filed in July, their refund was processed in the month of December. Why? Income tax refund. 31st July was the end date. Okay. Now you are getting the refund. That means after like 5 months you are getting the refund. Why? Sir, people used to claim fake refunds till now. Clear? Fake refunds when they are claiming, don't you think it should be verified and then paid? First of all, people are not paying tax. Clear? And over that you are claiming fake refund. So in that case, what they will tell is, sir, whenever you present a claim, there should be a process to verify whether it is actually a refund or not, and then only you should refund. Clear? Withdrawing money from the fund, all these things when I saying, check the mode of presentation, on what basis we are giving the refunds. Then regulation of condition of service, pay, allowance, pension of government servants. Meaning what? Any retired government officer, for him you have to give pension. From where are we giving? Fund only. Authorization should be checked. Clear? Like in some case, pension and all. Now imagine pension fund, money will be taken and given to your family members. Is it allowed? Absolutely not, because there is no sense only in that. Clear? Then audit of what? Sanctions. We should see whether whenever you are spending, that spending should be covered by a sanction. It could be a general sanction or special sanction. Example, flyover construction. Clear? Railway construction. All these are sanctions. It has to be approved in the parliament and other state legislative assembly, and then you will get that particular right to construct whatever you want to construct. It should be based on the sanction. Who should sanction? Authorized person should sanction. So what I should know? I should consider the following. Knowledge of sanctioning power, whether all sanctions are adequately noted. For petty expenditure, signature of authority on a bill can be regarded as a sanction. What is petty expenditure? Small expenditure. Tea bill, bhaji bill and all. Clear? So in those cases, petty expenditure, you just initial it. Provision of funds. Whenever we provide you funds, provision is made, appropriation is made. Spending should be done according to whatever grant and appropriation has been given. Does not exceed the meaning whatever provision is given, you have to spend within that only. Next, performance audit. Performance audit means what? Examples are, let's take one simple example and this concept is done. Imagine government comes up with a project that we are going to construct a flyover from point A to point B. And because this requires X amount of fund, because of this, these many accidents will be lowered. Because of this, traffic police will get extra job. Because of this, shops can be opened here, left, right, when they given budget. Now, imagine budget is approved. Approval of budget is not the end. Once budget is approved, we want to, as a CAG, he will go and check. You told that because of these are the benefits that we will get. Did we achieve that? That questioning is what we call as performance audit. Clear? Now, government comes up with various schemes and projects and programs. Clear? For example, they say, let's say for every girl child up till they reach 18 years, we'll be giving them 2,000 rupees per month, and their education will be taken care like this, like that. So many schemes will come. Now, whose money is going there? Public's money. So CAG will question, you brought a program, was it successful or not? Clear? Now, Prime Minister, Pradhan Mantri Awas Yojana, you would have seen, heard. Awas is nothing but house. Clear? So when you say in Pradhan Mantri Awas Yojana, or right now if you see Surya Ghar Yojana, right, in such cases, when you are presenting me that because of these many savings and all will be done, whether have we reached that particular point or not, or give me the status of it. That status is what we call as performance audit. Now, for others to understand that, let me give you more clarity. Whenever you feel that, okay, sir, where should I go and check the CAG's report? You go here, okay, you go here. If you go to menu here, you will see audit reports. If you go and see, you will get to see here performance audit reports. In performance audit, when you click whichever state you are from, you will get your reports there if they have conducted an audit there. Now, performance on what here? E-way bill system under GST. Now, government will tell, we are building an e-way bill system, for that we require some money. So, we'll have to give it to software engineers, we'll have to give it to the company. So, we are building a system. Whether that's what, now they'll ask, why do you need this system? Sir, because of this system, we'll be able to generate more tax like this, like that, and all. You'll tell. Telling is not enough, sir. After 1 year or whatever it is, they will go and check. Have you actually achieved what you had told before? Clear? Now, if I go and see here, whether have they done or not. Now, here on e-way bill, it's called performance audit. 82 page report it is. Let's just go through the summary of it. Okay. Now, what is e-way bill? Why we did this audit? That's the point. E-way bill is an electronic document required to be generated for movement of goods, capturing details of transaction. Okay. Now, implementing automation and standardizing the process was aimed why? To curb, can you see there? Tax evasion and enhance revenue collection. Correct. The EWB system was introduced with effect of 1st April 2018 for a value exceeding 50,000 rupees. For intra-state movements, EWB was mandatory from 15th April 2018. That means for every sale which is exceeding 50,000, you have to create an e-way bill. Okay. Now, performance audit was undertaken to examine effectiveness of the mechanism in protecting the revenue interest of the government. So, have you done that or not? What we found? Then they will give you their inputs in this. Clear? What we recommend? We have 10 recommendations. One by one, they will tell you enforcement functions, their response to us. Clear? So, like this, when they tell entire detailed report, they will give what you are supposed to do, and they will also tell you certain statistics also. I'll see if it is available here. Yes, see here. Now, this is nothing but passing on information on booked cases to the taxpayer services circle. So, what is the value of goods, invoice, challan number. Now, when I'm giving such details for you, that means whatever you have told, whether you have achieved or not, when a CAG gives you a report, a detailed report will be given. Based on that, you can improve on your performance. Clear? That's basically performance audit. So, to see whether achieved the desired objectives at lowest cost and given the intended benefits, it targets efficiency, economy and effectiveness. Objective examination. What does objective examination means? Unbiased examination. There is no bias in this. Why? It seeks to identify opportunities for greater economy and effectiveness. Basically, improvement. To see where we can improve, we do performance audit and not to pick out weakness there. Clear? Efficiency means any methodology where it can save my time. Economy means achieving the resources at a best rate possible. Reasonable, not more, not less. Because if you are paying less, quality issues will be there. If you are paying more, luxury can be there. Somewhere reasonable you have to see. Effectiveness means what? The method of performing should be effective. Clear? Right, sir. Next is stores and stocks. What does stores and stocks means? Inventory we are talking about. Examples are government stores, government ration shop. Remember, kerosene, wheat flour and all they'll get.
Right now, in those cases, somebody should send it to the shop. It is nothing but government is sending. In this, there will be a lot of fraud. You heard about plastic rice and all? Yes, so many things can happen. Correct? Huh? Now with the oil, they will mix some other oil. Yes. Now in such cases, sir, adulteration can happen, contamination can happen. In such cases, we need to, and ultimately we will raise finger on whom? Government. But is it government doing that? No, people in the chain, they do it. So ascertain whether internal control over purchase, receipt and issue of stores are well designed and properly carried out. So right from purchase, receipt and issue. Clear? Government will purchase. Yes, government will receive. Government will only issue. What we should do? Bring to the notice of the government any deficiencies in the system. Then, purchase of stores is conducted in the same manner as order of expenditure. Ensure that prices paid are reasonable. Uneconomical purchase. What does uneconomical means? Paid more, sir. Excessive, we have made the payment for inferior quality. Very good. That means some fraud is going on. Next, certificate should be examined. In case of any expert has given any certificate, examine that particular certificate. Okay. Any excess or idle stock should be specifically mentioned in the report. And C, go and attend physical verification of stock. SA 501 is what you can apply here. Valuation of stock also should be examined properly according to AS2. Next, audit of receipts. Receipts means what? Basically what we receive here. Now in this case, no, it could be example income tax, GST, customs, etc. EPF, ESA, all these things. So whether the government is receiving properly or not is what we are supposed to check. Number one, examine whether internal checks are imposed for prompt detection and investigation of irregularities, property tax, stamp duty, all these things, whether it is paid as per the rules and regulations. Number two, what is the procedure for demand collection? You know, we say a love letter from the department. That's called demand notice. What notice it is? Demand notice. There is effective check on assessment, collection and proper allocation of revenue. Sir, what is the allocation of revenue? You would have seen in some bill, CGST and SGST, right? So collection is done from one person and we'll be paying it to the department. Now GST department has to submit that, segregate into how much we have to allocate to CGST, how much we have to allocate to SGST. Although you pay it only once. In the invoice you show, let's say for example, 9 rupee, 18 rupees you collect from the customer. You pay 18 to the department. Who should allocate that? Department should allocate 9 for CG, 9 for ESG. Okay. Such regulation are actually being carried out. Revenue correctly evaluated, realized and credited to the government account and there is no leakage of revenue. What do you mean by no leakage of revenue? Leakage of revenue means what? Sir, bribe, eating up, right? Collected something, remitted something, in between you are eating that particular revenue. Those things should not be done. Clear? That is with respect to your government audit and cooperative society audit. Alright. Now, in this, I want to do one more, I will do one more called charitable institutions. Charitable institution. Now I'll give you the template for this. The regular students know it. Apart from cooperative and government, everything comes under one unit for us, right? This chapter we generally divide it into 3 units, right? A, B, C. One is for specifically cooperative society. One is for specifically government and one all others. Now for that all others, we have a set template. What is the template? Only 5 headings you have to understand. What are the 5 headings? Preliminary, that is basic. In basic, what all points will come for us? Understanding the entity, environment and ICS. That will come under preliminary. Then we have income related points. Then we have expense, asset, liability.
generally asset and liability will be same for all type of entities. Income and expense, even in expense, not everything is different. 90% of the expense will still remain the same. Few expenses will be here and there. Income, most of the income will be different. Although we say revenue only, but the type of revenue will be different. Correct? Now, if you are able to even write 2 points in every category, you have completed 10 points. Even 2 points if you write. Now, if you see current assets, fixed assets, correct? In assets, if you can write liability, known liability, and about contingent liability, correct? That is 2 points. Then we have in income, multiple types of income will be there. Expense, multiple type of expenses can be there. Preliminary is what you have to understand. Knowing about the client. Is he a company? Is he a firm? Is he a proprietor? What type of organization it is? If it is a company, we know MOA, AOA will come into the picture. If it is a firm, partnership deed will come into the picture. If it is LLP agreement will come into the picture. And if you are a proprietor, there is no specific agreement as such. Clear? Then, with respect to books of accounts, you can write in preliminary. With respect to internal control systems, you can write in preliminary. Logic here is, the institute has given you nothing but points. Just they've kept on giving you points. And if you see the inconsistency in hotels, everywhere they have given you different type of points. But in the hotel, if you see, suddenly they have changed the presentation of the content there. They have given me, I think, around 3-4 points there. Yes. Now, does that mean only that we will audit in hotels? So many things are there. Clear? Now, that's the reason these type of this rest of the units which I have as a separate subheading. No, here there is no concept as such. Clear? But the only concept you have to understand is, for a hotel, what is the revenue? For a school and college, what is the revenue? For partnership firm, what all audits can be done? So these are the points which is there. Next clarification, I am doing charitable institution, but if you technically see, charitable institution is nothing but 3 types: trust, society, section 8 company, which is nothing but a non-governmental organization also. NGO is what we call. NGO also can be like a trust, society, and section 8 company. Clear? If you go and see the same chapter, at the end they have given trust and society, which is nothing but again not-profit organization, which is a charitable institution only. So there is a repetition in this particular topic or in this chapter. Don't have to worry about it. Now here I have told you, cooperative society is you do, government organization you study properly. Other things, just give a reading. You need not stress about it. It will stay in your mind. Just giving a reading will stay in your mind. You just have to think, for a hotel what revenue will be there, for a theater what revenue will be there, for a cinema hall what revenue will be there, rather than skipping it entirely. It is something you can write. Clear? Easy questions will be asked here. No difficult questions at all. Yeah, absolutely no difficult questions here. Direct questions only they will ask. Okay. In case of charitable institution, what is the preliminary work we'll be checking? Study the constitution under which it has been set up. Meaning, as a trust have you set it up, as a society did you set it up, or as a section 8 company have you set it up. Type. Next, whether the institution is being managed in the manner contemplated by the law. Meaning, as per law only have you managed or not. Examine the system of internal check and also accounting of amounts collected, because since it is a charitable institution, it is exempt from tax. Therefore, money that is collected is very important. Okay. Verify in detail income and confirming the amounts received deposited in the bank regularly and promptly, because charitable institution, people can give you cash. Right. Now, everywhere UPI is accepted, but still people give cash as donation. Now, in those cases, check whether proper accounting has been done or not. Examine the trust deed or the regulation as laid down. What is the income for charitable organization? Subscription and donation. With respect to that, certain points have been given. Ascertain if the changes made an amount of annual or life membership subscription in case of certain organizations. Whether official receipts are issued. Check whether unused receipts books have been kept in proper custody or not.
Obtaining all receipt book covering the period under review. How many receipt book are there? Everything should be taken into consideration. You know why point number 1 is there? Imagine I steal one receipt book and I go to public and I tell we are doing this charity, please give us money and I will give you receipt. Now I will give you receipt, you give me money. All the money, what I can do? Take an abscond. I'll throw the receipt book there only, I will go and take the money. Now the finger will be raised on whom? The charitable organization. That's why unused receipts book should be kept in proper custody. Test check the counterfoils with the cash book. Any cancelled receipts being specially looked into. Meaning why? Imagine you have taken money and you have cancelled the receipt. The donor does not know. Imagine I gave you money, you took the money, you gave me a receipt. That receipt you cancel it. Clear? In such cases, be careful. Obtaining the printed list of subscriptions and donation and agreeing them with the total collection shown in the accounts. Meaning, whatever subscriptions and donations are there, take a list of it and check in the books of accounts whether it is matching or not. Then, whatever money received from box collection, flag days, etc. What is box collection means? You would have seen some people taking boxes everywhere. Sir, please give, this is for cancer, this is for this, this is for that. You will put money in that. That is called box collection. Clear? Then, paying special attention to the system of ICS and see whether steps have been taken for collections made have been accounted for. Meaning, whatever amount we have received, that has to be accounted properly. In between, there should not be any fraud. Right? Now, there is one movie in Tamil, you would have seen Rajini Murugan. Yes, where SK, Sivakarthikeyan will be counting money and suddenly he'll keep something. Money received. Clear? Money received. Suddenly you are eating it up. So, proper accounting has to be done. Clear? Verifying total subscriptions and donation with any figures published in the reports or issued by the charity. Example, annual reports. If in case annual reports are given, check whether proper disclosure has been done or not. Second is legacies and grants. Verify whether amounts received by the reference with any figures and other available information. What do you mean by legacy, da? Legacy means what? You know one legacy, right? Like when they say in sports, he's a very big legend. He leaves a legacy behind. Legacy here means, imagine I have very good amount of money, land, building, etc. I will write it in the name of a trust or an organization, but with the condition that this should be used for this purpose or that purpose, etc. Now, it could be conditional, it could be unconditional. That's the reason why you will be seeing in some of the places, they will name the place after the person. Clear? This fellow's auditorium, this fellow's ground. Why? So that his legacy continues. Clear? He would have done something great for the society. For that, to ensure that his name stays forever, the legacy continues, and that is what they say. In case if they have donated their land, building, asset, money, whatever it is, we call it as a legacy. Clear? Okay, sir. Next. Vouching the amount received with the relevant correspondence, receipts and minutes book. Obtain certificate from responsible official for grants received. Grant letter should be checked. What other income they have? Dividend you have to check. Interest they can receive. Clear? Then, apart from that, in case of any asset given on rent, then like shop, land, etc., rent received should be checked with the agreement and rent receipts issued. So, there are three types of income right now. Then we have special function. What does special function means? See, some charitable organization, they may give that particular auditorium on rent for events. So, if those cases are there, some performance will be there, cultural performance, wedding and all those things, they will be charging some money. That also is receipts only. Gross receipts we have to check. Sir, income tax refund. What do you mean by income tax refund, sir? Logically, charitable organizations are not supposed to pay any tax. But if somebody has deducted the tax on their name, then they should file the return and claim that money back. Clear? That calls under income tax refund. This involves vouching the income tax refund with the communication with the tax department. Check the calculation. What expenses they may have, sir? What expenses they may have? Payment of grants, AS12. If you remember AS12, grants comes with condition. And you don't satisfy the condition, you are supposed to refund it back to the
That is called expenditure only for me. It's an expense for me. Number one. Number two, verify the schedule of securities held, inventories of properties, both movable and immovable property. Verify cash and bank payments and any fund you have given for special purpose, meaning donation. Have you donated it to someone? If yes, we are have to vouch that as well. Clear? This is with respect to your charitable organization. Now the question is, you remember all points? Forget a marathon. Regular only when you are studying. Do you remember it? No. Now the question is here, what will you do in the exam? Therefore, that's why I highlight only key points. Now what if I was the student? No. How I will tackle this scenario is, these key points only I will write in one note and keep, or a sheet, or my short notes, wherever it is. So I'll simply write charitable organization and I will tell income. Only keywords I'll write and keep. You know what? The problem with students is, they want perfection. They want everything to be remembered as it is. Because somebody would have told you, some person who has not written CA exam, or some person who have heard something, in audit if you want marks, you have to write 100% CAM language. Clear? That means people who don't know English can't clear audit at all. And so many CAs have done CA without audit. They have cleared without audit only. Clear? Chuma, they have copied from someone else and passed. Right? So that is not the case. The case is, are you conveying the message to them? Right? Now, there are many Kannada medium people who have cleared CA. There are many Hindi medium people who have cleared CA. Marathi medium, Malayalam medium, Tamil medium, they have still cleared CA. Yes, you still are from, if you are an English medium student, no. Don't give that reasoning that I do not know English, that's why I am not able to write. You have to know English. You have to try to understand those words. That's why only keywords I highlight and keep. What you should do? At least with that keyword, if you are able to put a small, simple sentence, for example, income tax refund. Simple you can write now. Your NGOs or charitable organizations are exempt from tax. Therefore, they should receive their tax deducted at source, or their TDS, if they have been done, it should be received. Simple English. There is no Shakespeare English required here for you. Clear? So rather than why I did this particular thing is just to show you there are certain keywords. Focus on that and build a nice sentence out of it rather than skipping it. Now, for example, if I have to say subscription and donation, receipts are there, changes are there, receipt books are there, counter files are there, cancel. Now imagine, isn't it easier to remember one word rather than sentence? Remember this one word and go ahead with it. Clear? Now, for example, next, printed list is there. Then box collection flag days is there. Then in case of special attention to system of control over collections, total subscription and donations published. So if I simply write only whatever I have highlighted, no, it is more easier to just go through it. I am not saying sit and by heart it, but just go through it. Out of, like, for example, 8 points, even 4 points, if you are able to remember, you can still score that 2 marks. And in case if you are getting even 1 mark out of it, makes a huge difference, big difference. Clear? So 2-3 questions like this they can ask. So be little aware about these things. Understood? Clear? Right. Now with that, charitable institution is done. Now if you see cinemas. In case of cinemas, May 25, one question was asked. So let me finish off cinemas as well. With that, my previous question also will be done for you. Okay. With respect to cinemas, now I'm going as per your ICA material only. Now you see, charitable institution we did with the presentation that I told you, different categories. Now you see, with respect to cinemas, first directly they entered into free pass, then they went to internal control, then they went to taxation part, then they went to statement of tickets sold, then cash collection, ad, restaurant income, expenditure, depreciation, distributors. Now if you see, these are scattered. You don't know which point to write where. Clear? Rather than that, segregate and keep. What is income, what is expense, what is others. At least 2-3 points you'll be able to remember it. Something is better than nothing. Right? Free passes. Now free passes come under internal control system. Clear? But they are not given it under ICS. Now whenever you have given free passes, check the record should be under proper authority. Done. Meaning whenever free pass is given randomly, you should not give, only authorized person should submit that. ICS of cinemas. What is the ICS of cinemas? If you actually see, most of the points are outdated. Clear? And I'm telling it. It is not only, now when they say cinemas, there are two types of cinemas. One is your old cinemas, where through the printed tickets you enter. Now, in the era of QR, where you show the QR and you enter. No, I think here EA mall, those malls and all, you give printed tickets and go. No, sir. Even though you take a ticket in the counter, they will tell you ticket has reached your WhatsApp or SMS, PVR, yes or no. I'll have to click on that link, show that and go. But you see what is given in the textbook. Entrance only through printed tickets. Which definitely is not the case. Number one. Number two, serially numbered and bound into books. I have never seen a multiplex now where they have bound books of tickets. That means these people are talking about those old theatres. Even they have shifted to QR now. Are you getting my point? Whereas there are some theatres where they allow you through a printed tickets only. There are, but they are talking about that old cinemas, balcony, Gandhi class, first class, second class will be there. No, that cinemas they are talking about. Clear? Where different, and there, if you see, advance ticket different color it seems. Where 90% of the tickets now is advance. Before going to the movie only you book. But they've given that, makes no sense, but marks are very important. Who bothers what they are giving? We want marks. Clear? Number of tickets issued for each show should be different. Then, you see, advance ticket, separate series should be maintained, it seems. Clear? Now, for a show on Saturday, today if you book, what color ticket you get? Red color ticket, it seems. Which movie, da? Now, are you understanding my point? Book my show, Paytm, whenever you go and book, do you get color tickets there? No way, sir. You go and book in PVR, you will still get from the printer only, no? Even if they are printing it out. Clear? So, advance ticket, different series it seems. We have not seen that. They are talking about old theatres. Clear? Then, inventory should be kept in the custody of responsible official. Inventory of what? Where is the ticket inventory now? The only thing I have seen is printer roll in the PVR and all. That roll, whether you keep it in separate custody or not, doesn't matter because there is no print only in that. Clear? But again, yeah, these 5 points, if you write, see how many marks you are getting out of this. 5 marks you are getting out of this. Stressless 5 marks. These all are free distribution. Clear? Then comes taxation. Reconcile the tax collected with the tickets issued. Vouch and verify the tax returns filed every month. GST when you are filing, every month we'll have to check. Now, at the end of the show, they prepare something called as statement of tickets sold. Clear? Now, previously, when multiple modes of payment are there, cash, credit card, debit card, UPI, cash. So, they'll prepare a statement, how many tickets were sold and out of that, how much received from UPI, how many received from debit card, like that statement will be prepared, check that. Cash collection, entries in the cash book should be checked with reference to a daily statement. If in case of ad, check the agreements entered into with advertisers. So, you would have seen in movies, no? Different. Before the movie starts, Mukesh Bhai will come, Clear, Suresh will come, so many people will come and give their products. Now that ad, we will collect money from them so far as it is an income. Similarly, we spend on ad. Clear? Like radios, then holdings if you have seen. Clear? We also spend on it, which is an expense. Both income or expense, we have to check agreement. Next, restaurant income. Now these business theaters will have restaurant income. 2 types of restaurants income they will be having. One, run by their own. One, let it out on rent to someone else. If it is run by my own, it is not rental income. It is called as other income. Clear? Sir, if it is given on rent, then other income, no. Other income only, bigger heading, but specifically it is rental income. Now that will be of two types. One, specified percentage of sales, and one fixed. Every month so much you have to give. Then in case of restaurant, you have to check the inventory also. What other expenditure you will be having? Add, repairs and maintenance, etc. In regular class, no, students, you should have remembered what we do is we think of a process. Whenever we start an entity, we think of a process as to if it is cinema, right from step number 1 to entering into the premise till we finish, what all things we see, so that you are, you can write your own points, and how many ever points is possible, we can relate to that particular content. Clear? Same logic here, expenditure and all you see. Depreciation will be there. Distribute as an advance paid. Check the payments with respect to agreements of distributors. In case if you have paid more, next time we should adjust it. Now technically, it's random points I have given. Now after this, what is that? Nothing. So technically what? A cinema does not have an asset. They don't have a liability. They don't have capital. But where are the points? Not there, sir. So this is, you don't have to worry about it. Clear? Just understand the keyword, what is given. Here, if I go into the concept, no, not all conceptual points are there. Clear? Now in a hospital also, very similar points are there. Not everything is covered everywhere. Right? I honestly feel this is a little too much for CA students to digest. The syllabus is like going little overhead with chapter 5 and chapter 9. Can't do anything. We have to suffer with that only. Clear? So I'm just, why did I do this also now is just to give you an idea that at least there we had seen some extra points in charitable organization. Here that also we have not seen. So it is randomly given, scatteredly given. That's why I'm telling you, remember 5 categories. Initial category, income, expense, asset, liability. Whichever points you are reading, you just put one word under that, revise it and go to the exam. Do not skip it, because sometimes easy questions will come. Clear? 5 marks, easy 5 marks you can score. Clear? Right, sir. Apart from that, if you want me to do anything else from this, please let me know. I will do that. If not, I am going to chapter number 5. Chapter number 5. Audit of items of financial statements. Okay, chapter number 5. Financial statements items. This is one nightmare chapter for CA students. Yes, sir. If you open ICA material, skip only. Yeah. How many 120 pages is there I think in that material? Clear? 100% for CA students, in audit there is only 10 chapters and not 11. Because you will tell chapter number 5 and all for sir, that is a novel for us. ICA has given us a novel to read after exams. That's what people think about this particular chapter. They are okay to study chapter 9, but not chapter 5. Correct? Huh? Don't worry. I am reading your mind like one book now. Okay? Don't worry. In this case, I'll tell you what exactly to understand first. Clear? Every item in the financial statement, this is nothing but, they say financial statement, they mean schedule 3. Clear? All schedule 3 points are only, line items are only there here. There is balance sheet items and there is P&L items. Now, I for a reason know that 90% of the students will skip this chapter. For sure. But ICA has a way of giving you gifts. This chapter is worth 15 marks. Now, you will tell, no problem, sir. We have reached the point where it doesn't matter for us. Clear? Now, this chapter gives 15 marks. What they will ask, God alone knows. Clear? Absolutely unpredictable question can be there from this chapter. But what I would suggest is, at least do P&L items and go. Because there are 11 items in balance sheet, 6 items in P&L. Technically, 50% effort is reduced. And in P&L also, no, not all are going to be asked. Clear? So this particular chapter has a base called assertion. What I mean by assertion, whatever management claims is what we call as assertion. How do they claim, sir? Through their financials. So in the balance sheet and P&L, whatever they give, that is what we call as assertion. Clear? If they say in our balance sheet we have a building worth of 10 crore, that means they are claiming that the building is their and it is worth 10 crore. Now we should not blindly believe. We should go and check. And that checking is what we call as chapter number 5. Basically, we can also call it as TOD chapter. What is it? Test of details chapter. Clear? So, with respect to the assertion, it refers to the representations by management, explicit or otherwise, that are embodied in the financial statement as used by the auditor to consider the different types of potential misstatements that may occur, not will be there. Clear? Now, if I tell you that I own a 10 crore Rolls Royce, in my balance sheet I will put car 10 crore. Now you look at my balance sheet and you'll be like, wow sir, nice. Now you are a CA, will you sign that balance sheet? Huh? Why?
We didn't say.
You didn't? So I am telling you, no, I have a Rolls Royce worth of 10 crores.
Take me for a round.
Take me for a round. In what capacity you are asking? That's more important. Clear? Now, if you say abdiye round by income tax will go, sir. Now, when the moment I say I have a Rolls Royce of 10 crore, no, you'll be like, ama. If you have a Rolls Royce of 10 crore, you'll be coming for teaching. Now, whatever I say, should you believe? No, sir, you should not believe. Now, if I say, for that matter only, I asked you a question. If I say I am a chartered accountant, are you believing? Huh? Without, now what proof do you have that I am a CA?
Without say you've got deeds here.
Without CA? But did you verify that policy?
Even that policy has that clause.
Sorry?
That policy has that clause.
Did you see that clause?
I didn't see
Exactly my point. You forget about me. Did you see? The question is about you. Yes, you do not know whether I am a CA or not. If I put in the book as CA Karthik Chennai, is it enough? I'll be telling commercial accountant. Yes. Now if I say CA Karthik Chennai, you'll be like, okay sir. First day I told I am Karthik, that's it. Now you're like, why did you tell CA Karthik? Why should I tell CA Karthik? I'm not a CA, I am a CA. Now do you have a proof to verify that? You don't have a proof. So where is Sai for you? But you believed it. Correct? This type of belief is what ICA doesn't want you to have. Right? You have to verify. Clear? So next subject, no, regular class students, if you're attending regular classes, next subject, whoever comes, no, ask, where is the proof that you are a CA? No. In that, class has already started, which means you have accepted, right? New faculty you should ask. Whatever is gatam, clear? Now that's the logic. Whatever management says, if we believe as it is, that means we are buying that assertion without any verification. So you should first have that particular logic as to, sir, whether whatever management is saying, is it true or not? Clear? Now you tell ICA, then I have studied ICA, give me certificate, give me the degree. The examination is chapter 5 for them. They are testing whether whatever you have told is true or not. Clear? Otherwise, everyone can take that degree. No, I have studied, give me CA degree. Clear? And when client comes and tells you, do consolidation, you have absolutely no idea what is consolidation. But you are told I have studied consolidation. Spelling I know. I will write the heading and tell you. Clear? But how? Minority interest. Who is minority interest? Right? So, if you do not know whatever you are claiming, it has to be tested. That testing is what we call as chapter number 5. Understood? Okay. Now, balance sheet captions and income statement. Income statement means what? P&L. Clear? Balance sheet means what? Balance sheet. Very good. Nice. First, we have to check occurrence. Meaning what? Sir, whatever income or expense you are claiming in the P&L should occur. Sir, my neighbor spent 10,000 rupees on flight. In my P&L, I will write traveling expenses account debit. Is it right? No. First question I'll ask. Why are you debiting neighbor's travel expense in your P&L? Why? I don't know. Could be. RP transactions. No. Now, I need to see if it is a business expense only, then it will be allowed. Okay. I purchased, let's say for example, I purchased Meta glasses. Okay, I purchased what? Meta glasses. That I am debiting, I am considering it as a capital expense for my business. Can I do it? Now let's say for example, Gen 3 is around 72,000. Okay, 72,000 I'll pay and I'll buy one glass. Okay, this I will debit it to our asset. Therefore, asset account debit to bank account. I'll claim depreciation also on that, and I'll claim GST input tax rate. Is it allowed? Why? How do you know? I'll be wearing for the classes also. Can you prove it now? No. Right? Now I'll tell, hey Meta, record the video. Now when you're talking something, no, I'll record and keep. Evidence. Possibility. Yes, sir. Absolutely right. Now I can claim, sir, because if I'm able to prove it is a business expense, it's allowed. Clear? I will tell, I'm wearing it during the business. Why? I can see clearly. Otherwise you can't see. No. Now proving is very difficult in reality. Clear? So that is the logic here. So in those cases, now we have to see whether it has actually occurred or not. Whether P&L, when I say income statement, I say P&L, balance sheet means asset, which means capital expenses will not be there in P&L, should be there in balance sheet. So we have to check. Did it occur first of all? Number two, recorded everything. Every expense, every income happened in that year should be recorded. Nothing should be left out. Accuracy, whatever data you are recording should be accurate. And now point number 4 is, and this is point number 4, cutoff. What do you mean by cutoff? Cutoff is nothing but it should occur during that particular period. Next year expenses should not be debited now. Last year expenses should not be debited this year. Then comes classification, capital or revenue, direct, indirect, proper classification has to be done. Presentation and disclosure. The way you present and disclose should be complete, understandable and valued properly. Next comes balance sheet captions. Asset or liability should exist. Existence. Next. Rights and obligation. Asset means I have a right. Liability means I have an obligation. Cutoff and completeness. What is cutoff again? Relevant period. Completeness means in that relevant period whatever has happened should be recorded. Valuation and allocation. What is valuation and allocation? Valuation of current assets is separate. Valuation of fixed assets is separate. Presentation and disclosure, properly classified, described and disclosed. See, in asset side, no. Fixed asset can go to current assets. No problem. But asset total shall remain the same. Current asset can go to fixed asset. Asset total shall remain the same. But it is not a proper disclosure. So properly you have to classify, describe as well as disclose. What are the procedures that I can perform, sir? Same ROAE. Same ROAE, R square, recalculation and reperformance, inquiry and inspection, observation, analytical procedure and external. We have seen this long back. Clear? In SA 500 only we had discussed this. Right? Now you see share capital starts from here. 1, 2, 3, 4, 5 page, 5.5 page as if you will write. So in this, no, what they will ask is, for this, their assumption, that's why I'm telling you, as an audit student, it will be difficult for you. That's the reason why it is there in group 2. This is straight away coming from your paper number 2. Clear? Everything is your law concept. Okay? If you see general procedures, tally the period end share capital, meaning closing balance and opening balance, obtain written confirmation, then check the limits of authorized capital. Where is it mentioned? MOA. And what is MOA? Memorandum. Where is the details given about MOA? Paper number 2. Clear? Relevant resolution. Do you know which resolution to pass when? No, because where is it given? Paper number 2. Next, fresh issue made. Where is it given? Paper number 2. Clear? Those who have attended law classes, written off allotment PAS 3, minimum subscription section 39, minimum application 5% or 25%. Everything is given where? Paper number 2. Clear? Separate bank account, underwriting commission, discount, all these are given in paper number 2. That's why here it will become a little difficult if you have not done group number 1. Clear? Then comes shares at premium, straight away section 52. So you have to learn 52 for that, which is nothing but shares issued at premium. You are allowed to spend this money only in 5 ways. Bonus, buyback, expenses, premium payable, preliminary expenses. But if you are a company which is satisfying with accounting standards, then you are allowed to spend only on B square and E. T square is not available for you. Clear? That is bonus and buyback and expenses. Just I can't do anything. It is nothing but section number 52 concept. Okay. Any application money, whatever you have received, should be checked, and any application of SPA should be checked. Application is nothing but usage of SPA. Usage of securities premium account. Shares issued at discount is section number 53. You are not allowed unless and until you are giving either sweat equity shares, clear, or you are giving ESOP, or you are giving it to creditors. Only these things are allowed. Next comes sweat equity share, section number 54. One lengthy section will be there that you have to follow. Reduction of share capital, section number 66. Procedure you have to follow. Buyback and bonus if it is given. See, that is not there again. Clear? 4 or 5 sections they have given and the rest they have not given. Bonus buyback if you have given, section 63 and 67. Again, that has to be checked. Okay. Now, with respect to this, I will do P&L for you and tell you, see, very small thing. Don't ignore that. If your luck is there, nice. You'll be able to at least score something. Now, we have sales, other income 2, purchases 3, employee benefit 4, depreciation 5, and other expenses 6. Okay. Let's talk about it. First one, sales. What we should check in sales, sir? Sale of products and services. First one we should check is called occurrence. So check whether invoice is recorded twice or cancelled sales invoice could also be recorded. Then entries in the sales journal. Sales journal means what? Journal entry of every sale that has happened, you check. Obtain confirmation from few customers and ensure fictitious customers are not there. What is obtain confirmation here? External confirmation you have to check. SA 505. So that fictitious customers are not there. Fake sales. Shipments were done without the consent and agreement. You'll have to check. If you remember in regular class we did was ITC report we had read once for key audit matter, where they said the revenue will be recognized only after delivery of goods. Now delivery means shipment has to be done. Clear? So if shipment is done, the shipment should be done on the consent of the customer. Without customer's consent, you should never ship the goods, because if something happens, then you will be under loss. Review sequence of sales invoice. Review entries for unusual transaction. What does unusual means? Excessive discount if you have given. RPT transaction outside normal course of business. Ratio of sales return to sales. Why is that? Sales return to sales. Why? To know how much proportion is sales return compared to sales. Check sales return with a sales invoice, challan, credit note, etc. Now completeness, what we see every time, they will not ask you entire thing. Either they will ask you only occurrence points, or they will ask you only completeness. Like that one point they will ask you. That's why what I have done is I have highlighted only one phrase in that. In competence, check cutoff procedures, credit notes you check, shipping documents you check, quantity in the register properly appearing or not, reconciliation of goods and GST, review GST tax returns and reasonableness of GST, meaning proper rate only have applied and not more, not less. Clear? Measurement. In case of measurement, what we should see? Trace a few transactions from start to end. This is what we call as walk through test. Then, if it is an export sales, check AS 11, foreign currency exchange. In case of, I have to understand what my client is following, operations, that is his business, and what is the gap issue, Indian gap, US gap, whichever clients you are having. Compare the rate of sales with RP. Why? There could be a risk of bad debts. Okay. Disclosure, what we should say? Revenue from operation, product separately you have to show. Services you have to show separately, other operating revenue. In case of brokerage and discount on sales should be disclosed. Which discount? Other than trade discount, that is cash discounts. Show separately. Transaction with RP should be appropriately disclosed in the notes to accounts. In regular class, I showed you the entire RPT of a company. Entire schedule I had shown you. Right. This was asked for 5 marks. Specifically, they were asking accurately measurement they were asking. Other income, what other income? Anything apart from sales. FD is there. Clear. Then what else will be there? Interest from FD. Yes. Dividend income will be there. Everything you check arithmetical accuracy. What is arithmetical accuracy? Calculations you have to check. Obtain direct confirmation from the banks for interest certificates. Interest income you check. 26 As you check. In case of dividend, right to receive must be established. And what is right to receive means? When the company declares dividend. Gain or loss on investment in mutual funds. Example, selling mutual funds will give you either profit or loss. If it is a profit, it has to be credited to P&L. Check that. Then, obtain mutual fund statements from the broker. Transactions that are not recorded in the books as undisclosed income, which we have already seen in Caro. Clear? Unrecorded income. That should be recorded in the current year. That will be shown as income here. Okay. Purchases. Let's talk about occurrence. Same ulta of sales. Clear? Fictitious there, customers. Here fictitious, vendors. Any security gate invert register. I have already told you the purchase cycle. If you remember. Clear? In marathon also I have told you the purchase cycle, sales cycle. Same logic here I am checking. Quality inspection have you done? Goods receipt note was prepared. Purchase invoice was approved. And whether the stock record has been updated, inventory. Clear? Then purchase invoice should be original copy and not duplicate. Sir, why original and not duplicate? You are the buyer. You should get original copy. Seller will have duplicate copy. Clear? Purchases should be in the name of entity. Input tax component should be in input tax ledger. Clear? In case of purchase from RP, verify approval from board of directors. Review entries for unusual transaction, that is again RP. Perform cutoff test. Goods in transit you check. Obtain WR from management. Important point is the next one. JKL. Sir, this can be asked in the exam, right? What type of analytical procedure I can perform in case of purchases? Number 1, consumption analysis. What does consumption analysis means? Not how much you have purchased, how much you have consumed, used. Raw material consumed as per manufacturing account you have to take. Compare the same with previous year. If there is any variance, ask for the reasons. Stock composition analysis. What does stock composition means? Proportion. How much raw material is percentage of total stock? How much is WRP is a percentage of total stock, and how much is finished goods? So out of total inventory, what is the bifurcation? Then ratios. Compare the credits turnover ratio and stock turnover ratio with previous year. Sir, what is this ratio comparison? Talks about ratio analysis, which is your essay 520 topic. Review quantitative reconciliation of closing stock with opening stock. Then give disclosures as per schedule 3. Now that is with respect to your purchases. Now if you see, it's like everything they are dumping onto you. So what you should see? Cycle is explained to you. Keep that cycle in mind. At least 3-4 points you'll get in that. Invert register. Yes, it will go to the inventory. That means stock updation should happen. GRN should be given. Purchase should be verified. Inspection, quality inspection should be done. Payment should be done. And vendor should be real. So if you are able to think about the process, now 3-4 points easily you can write. Employee benefit expense. What does employee benefit expense means? Whatever payments have been done for employees, we call it under employee benefit expense. Salary, everything will come here. What we should see? ICSUC. Test the internal control, how effective they are. Then take a sample of transaction and check that. Then obtain understanding of capturing employee attendance, biometric, facial recognition, what your, in your organization you have. Obtain a list of employees and check new hires salary was processed as per the agreed terms, meaning new person's salary should be as per appointment order. Resigned employees, obtain final computation and whether it has been paid right away. Obtain monthly salary for all 12 months. Check and see. Provision has been made for benefits, that is your ESOP, sweat equity, etc. in case if there is any provision. Then in case of PFESI, compile reasonability, meaning what? Calculate and see whatever they have debited, clear, versus whatever has been given to you. Check that. Perform analytical procedure for reasonableness and disclosures as per schedule 3. See, we see some points, so many they have given, some topics, very less point they have given. So I'm just giving you wherever possible, I'm highlighting 1 or 2 words for your revision purposes. Depreciation and amortization talks about what? Depreciation is for tangible, amortization is for intangible asset. So what we should see, this is important. This is applicable for both depreciation as well as amortization. Nada?
In AS, we exclude ESOP as in employee benefits.
No problem. Because ESOP is not accounted as per accounting standards. ESOP is accounted as per guidance notes. Clear? As per guidance note, when we account for ESOP, first thing we create is employee benefit expense account debit or employee compensation expense account debit. So that is basically for us, it's an expense. So we separate that and keep as a provision. Every year we book expense of it. In accounting standard, it is not considered as employee benefit, but at the end of the day, when they say it is nothing but benefit for the employee only, for us it is an expense. So ESOP, how it works is, imagine there is a 1,000 rupee stock. Market it is trading at 1,000 rupees. For you, I will not give it at 1,000. Let's say I'll give it at 600 rupees. The rest of the 400 is my expense. For whom am I spending this? For your benefit only, no. So technically here we can consider that as an for audit purposes. In your AS we will not. Yeah, but companies does not follow AS, they follow Ind AS. Okay. Right, sir. Now whether under Ind AS, whether it is considered as expense or not, please now don't consider that. I know Ind AS there. Now whether under Ind AS, whether employee benefit is being considered or not, I do not know. But in audit, all the payments for the employee purposes, we will be considering them as employee benefit expense. Okay. ESOP is little different accounting. Okay. Right. In case of depreciation and amortization, check the policy first. Then whether you are charging as per the policy, consistently have you applied, proper disclosure have you given, after adjustment of residual value only you have calculated. Then whether the charges are valid and whatever charges you are putting, is it accurately calculated and recorded, appropriate period, parts depreciated separately, and what is the method of depreciation. These are the 10 points I should check for every type of depreciation and amortization. Okay, one by one, just one word you see and go to the exam. Next, what is the procedure I should check? Now don't tell this is the procedure. These are attributes. These are nothing but attributes. These are not procedures. Next. See, what is the process of charging depreciation? Basically, do we charge monthly? Do we charge yearly? Check that. Then obtain fixed asset, register, obtain sample of asset, ensure all the intangibles have been amortized over the period, and the depreciation should be charged only when the asset is ready to use and not put to use is for income tax. Don't consider that here. Okay. Depreciation on revalued amount should go from revaluation. All your accounting concepts are coming back. Clear? Perform analytical procedure, arithmetical accuracy. Then depreciation should be as per useful life. Residual value should be properly verified. Clear? Then if there is any change in the life, depreciation should be computed prospectively and not retrospectively. Clear? And then disclosures. Clear? Now if you see, nothing of depreciation we have learned something extra outside your accounts. Whatever you have learned in accounts is coming back as an audit. Okay. Other expenses, what we'll be having? Anything apart from that. What expenses, sir? Rent. Every month you will be paying rent. So 12-month rent will be there. Then power line fuel again. 12-month rent will be there. 12-month expense will be there. Check the variation. Insurance, legal. Clear? Travel, repairs and maintenance. Benami property. Benami property, there is no expense as such. This is just a disclosure part. What disclosures you have to check? Details of the property. In Caro we had seen, right? Same point here. Amount, beneficiaries, all these things you write. CSR is important. Don't ignore this. CSR is important. In CSR, what disclosure we have to give? Amount required to be spent, amount of expenditure incurred. This is how much to spend, how much I have spent. Difference between this is point number 3, shortfall. Fourth one is total shortfall. In the entire year till date, what is the total shortfall you have had? Reason for that, what type of activities you guys are doing? Is there any RPT? What is RPT means? Companies and, what is RPT? Company and their own trust will be there. Now Tata will have Tata Trust. Reliance has Vantara. Yes, through Vantara I will do CSR. So RP transaction only, no. Yes, both are same family members. If the provision is made with respect to liability, then check the contractual obligation and check the provision differently. May 25, they have asked only 4 matters out of this. See how easy it is. Out of these, you should write only 4. Nonsense question for me. But for a student, it is easy questions. Clear? Right, sir. But questions are easy. Answer you should write. No. That is what institute pinches. Institute is very good at making you feel guilty about not studying. Clear? Now you study that standards left, right and center. No. You feel it is worth wherever when you go to the exam and write. But chapter 9 and chapter 5. Clear? Direct question. Easy question. But they'll make you regret in the exam hall that I skipped it. So my point is at least P&L. One question they can ask from P&L. At least study P&L and go. Nothing big deal here. Number 1. Number 2, 9th one, I gave you an idea. Do societies, do government and do others based on one keywords. Clear? And that group is there to study that group wise. Clear? Right, sir. With this chapter 5 revision also is done. Right? Now, let me start with your RTP Jan 26. Let's do that RTP once. Let's discuss it together. But before I begin RTP, just want to tell you with respect to the chapters that we have done. Clear? Now, this entire standard marathon, I tried to cover as many standards as possible, but standards I have not skipped any. Clear? I have done all standards revision for you guys. Clear? Now, for every standard, question is not possible due to the time constraint that we have. Number 2. Number 3, as much as possible, we have tried to cover important areas of other chapters as well. Clear? Now, standard, non-standard based chapters are very simple to understand. Right? Chapter number 5 is a non-standard based chapter. Chapter number 9 is a non-standard based chapter. Chapter number 10 is a non-standard based chapter. Apart from this, all chapters are standard based, including your chapter number 1. Chapter number 1 talks about SCA 200. Then we went to chapter number 11. Clear? So I would recommend if you are revising, you revise in the same order. Otherwise, now on YouTube timestamps will be there. According to whichever chapter you are revising, you revise. But if you are studying, now those who are, there are some students who watched Jan marathon for May to understand how things work out. In those cases, always follow a good order of studies. 1, 11, 6 and 2. Clear? These are the first 4 basic chapters we will be doing apart. Now, before starting this, you have to start with basics of audit. Now, 18 concepts of basics of audit is there. Finish off that first. Then go to 1, 11, 6 and 2. Once that is done, do chapter number 4. Once that is done, do chapter number 7. Clear? Once that is done, do chapter number 8. 8, you can divide that and study. Standard based you can do later. Caro, branch audit, joint audit, section 143 you can do separately. Clear? Now, we are left with which chapter of standard now? Chapter number 3. Do it at the end. Sir, why sir chapter 3 risk assessment initially we require? No, that is why I told you basics of audit you do first, because the chapter 3 basics I have also covered in basics of audit. Once that is done, all standard based chapters are done for you. The rest 3 chapters, whenever you want, you can do one unit and complete it. And that time only one word you write and keep for every entity or every item of financial statements. That way, clarity will be better. Number 1, you need not skip. You are skipping with an informed thought process. Clear? So that is what I wanted to tell you, that with respect to the marathon and preparation, right? Number one. Number two, with this marathon, can I score exemption? Absolutely not. But will I be able to get at least 40? Only looking at this particular video, you will not get it. You will also have to study and revise. None of the faculty can guarantee your result. Clear? No one can guarantee your result. Even ICA cannot guarantee your result. Therefore, we are no one to guarantee your result. But I can promise you that if you have studied properly, this revision would be nothing but a cherry on top of the cake for you if you have studied properly. If you have not studied properly, then you will be feeling this as a fast way of seeing things, which is absolutely normal, and that is the reason we call it marathon. Clear? We are not walking here, we are running through the portion. This is like a brushing up of the concepts. Clear? With this, we will stop marathon. We will continue the RTP discussion. Okay. Now, RTP discussion doesn't come as a marathon, because if I will know the question, you should know the question. No. Clear? So let's talk about RTP now. Yes, sir. Let's talk about RTP for Jan 2026. Okay. Now, paper 5 auditing and ethics, your paper has two concepts. There is two parts. One is multiple choice MCQ and one is descriptive part. Clear? Now, RTP layout, if you see, if we finish off, if we go to the MCQ part and we done with it. Now, descriptive. If you see, technically chapter wise only they will be giving the questions. So, it will be more easier for you to cover up as and when your chapters are done. So, how many total questions we have to deal with, sir? 20 questions we are supposed to deal with. Clear? Now, for descriptive part, let us do later come to MCQ part. Let's talk about the first case scenario. CA Anuj is in the practice for the past few years as proprietor of Anuj and Associates. He is very keen on documentation aspects while performing assurance engagement. So for me, this could be a keyword. I don't know. If I'm reading as a student, what could be my attention grabbing points? Okay. He handles audits of various corporate and non-corporate clients. The proprietorship concerns also handles review engagements as well as engagements to report on PFI. Okay. This could be another attention grabbing term for me. As per needs and requirements of his clientele. Presently, it's handling audit of Buddy Enterprises, a partnership firm. Okay. For financial year 24-25, in the middle of busy audit season, this business enterprise also availing cash credit of 10 lakhs from CDB Bank. Cash credit means what? Drawing power concept can come. I don't know. Clear? See, I am also, I'll tell you for your comfort. I am also reading RTP for the first time. Okay? With me, you are also reading. Okay. The firm's partnership deed contains a clause stipulating audit of financial statements by a firm of CA every year. There is no legal requirement, meaning mandatory audit or voluntary audit. Chapter 1 concept. Drawing power which chapter? Bank audit chapter. PFI which chapter? Chapter number 1. Okay. Now next. The team has planned everything from RAP chapter number 3. TOC chapter number 3. Planning chapter number 2. 1 covered, 2 covered, 3 covered, 10 covered. Okay, let's see. Plan and audit program. See, came. Chapter number 2. Duly documented. Essay 230. Chapter 6. However, during the course of audit, some information has come to notice which requires change in audit plan lead to revision of strategy. Chapter number 2. See, you can connect it. Clear? J. Junior team member is pondering over documentation requirement in this particular situation. Meaning, simple tell me, he is thinking what to do. Should I document original plan? Should I document original plan?
Because revision is going on only.
Because?
Revision.
Should I require to document original strategy? Should I document revised strategy? Yes. Should I document reasons for revised strategy? Yes. Okay. Let's see. I don't know. I'm also reading for the first time. Another team member K has understood the meaning of which chapter? SA 500 chapter number 4. Okay. However, he is wondering over obtaining sufficient appropriate evidence in case of assurance engagement which may not be in the nature of audit. That means they are not talking about audit. May not be in the nature of audit. Therefore, it could be review or it could be. At the initial stage, team has determined materiality for FS as a whole at 5% of SA 320. Just now we did benchmark. They took profit as a benchmark. So 15 lakhs is a profit. 5% is what? 75,000. K is also concerned about documenting materiality as a part of audit documentation. Okay. Should I maintain documenting materiality? Yes. Overall, OM I have to document, PM I have to document, revision in the materiality I have to document. K vividly remembers that assurance engagement involves three-party relationship. However, another team member confronts him with the meaning of three-party relationship. Chapter number 1. Elements of assurance engagement. How many people are there? 3. Who are these? Pati, Patni and O. Who are these? Number 1. Practitioner. Responsible party. Intended users. Don't write management, CA and all. Clear? 3 people's name is important. Okay. In accordance with the terms of sanction letter, it has been stipulated by the bank that partnership firm is required to submit quarterly stock statement during the quarter year end 31st December. Value of stock declared by firm to bankers is 10 lakhs and margin is 20%. Okay, now what do you want? Considering the dilemma of J described in the scenario, which of the following statements is most appropriate? Only overall strategy needs to be documented by the team. Only plan needs to be documented. Both strategy and plan needs to be documented. Strategy, plan, significant changes made during the engagement to the strategy, plan and reasons should be documented. A, B, C, D. D, don't worry, you will not lose marks because you will not get. A, B, C, D. D. D, no? See, I don't know. I am just taking what you are telling. Because it is a question paper which you have to see. So, if you say D, I will put D. Then we will go and check the answer. Which one? Online. You can also respond. No problem. D, sure, What is the reasoning behind that? Sir, only audit plan, strategy, what is the point? Strategy develops plan. So, only strategy, waste. Only plan also. Sir, both if I document, then changes will be gone. So, this also is not the answer. This could be the answer. I don't know. I don't know. Okay, let's see. Second one. You write and keep, okay, because I will be keeping, I'll have to move from question to answer, answer to question. So, you write and keep, okay. Now, guide K with respect to most appropriate statement concerning obtaining sufficient appropriate evidence as described in the scenario. Sufficient appropriate evidence is to be obtained only in case of statutory audits. In the given case, there is no requirement of law. Hence, there is no need to obtain sufficient appropriate evidence. Okay. Next. Here is the first option right. He is saying it is only applicable for audits. Therefore, here there is no requirement, no need to obtain sufficient appropriate evidence. Is it right? Huh? No, even if you look at me, I will not give you the answer. You answer. Because, no. I will not answer. I will definitely not answer. It's your answer. You tell me. No? So, what is the reason behind saying no?
Because auditor, but review is not sufficient. For review also sufficient appropriate evidence is
correct. Sir, sufficient appropriate evidence is not just for audit, even for review also, even for assurance engagement also it is required. So, point number A is not there. Okay. Point number B. What are you waiting for? Read and give me the answer. Loose tools. Sufficient appropriate evidence to be obtained in audit engagement, review engagement, engagement involving examination of prospective financial information. B, So, you don't want to read C and D. You always have an option and then select. Just because one option looks beautiful, don't commit to the option. Yeah, I am talking only about MCQs. Sufficient appropriate evidence is to be obtained in audit engagement and review engagement. It is obtained in all audit engagement. Definitely, it's not point number D. Because they only spoken about Between B and C, which one? Huh? B, yes, sure, sure, no? I don't know. Okay. That means you are saying not point number C. Fine. I don't know. We will. Prospective is there here. I don't know. That's what I'm telling you. I am marking your answer. Point number B, Okay, fine. Third one. Advice K regarding most appropriate statement in respect of documenting materiality. Materiality of 75,000 needs to be documented. PM, which is set at more than materiality for financial statements as a whole, to be documented along with. So they are talking about PM plus OM. Now tell me, PM is more than OM or less than OM? But they are told what? Set at more than. So this is drunk option. Okay. Next. PM, which is set at less than OM, should be documented. So they are saying PM is less than OM should be documented. So they are telling only PM should be documented here. This also is only about PM. Then they are saying performance materiality, which is set at par level materiality for FS as a whole, requires to be documented along with the, which is right. Sir, PM I told you is not equal to or more, because that's why concept is very important. Clear? By hearting will not work here. PM, if it is more than OM, lose only you are. Number one. Number two, PM equal to OM. What is the point of PM? OM only we can take, no. So PM should be. So only OM should I recognize, or PM and OM? PM and? I don't know. Next. Fourth one. Which of the following combination best describes three-party relationship in the context of partnership firm? Anuj and Associates, management partners of buddy enterprises and income tax authorities. Very good. These people are practitioners, No, drunk option. Next. Individual income tax, nonsense. See, this is how you have to eliminate certain option. Waste of time. Anuj and Associates, management and partners of buddy and bankers. Bankers are practitioners, I will not read D. Clear? Again, I am not responsible for the answer. I am giving only reasonable assurance. You should use your mind. Now, which of the following statement is true regarding drawing power? DP is 10 lakh and firm can withdraw up to 10 lakhs. DP is 12, firm can withdraw up to 12. DP is 8 and firm can withdraw up to 10. Nonsense. Possible, Allowed only 8. We can withdraw 10. 2 from father's house. DP is 8 and firm can withdraw up to. Now, the rest 3 seems valid. But now you have to calculate. How do you calculate DP? Stocks, do we have any creditors given? No. So 10 minus 0, how much? 10. What are you thinking about? 10 minus 0 is 10. What is the margin? 20%. 10 minus 20%. 8 lakhs is what the DP is. So how much you can withdraw? DP is not 10. DP is not 12. DP is, D for DP, I don't know. Let's see. You have marked it, What is first option? D. Second option? B. Third option? Fourth? D. Fifth one is D. Okay, right. Let's go and see whatever you have done is correct or not. First one, what have you written? Oh, right. Second one? Oh, nice. Third one? Correct, Yes, Fourth one? Oh, yo. See? Correct, no? Yes or no? All 4 is right. Congratulations. Fifth one is there, Fifth one is D, na? D for DP, yes. See? I told you, where are you? You are here. ICA exam is here. Sir, we'll figure it out, sir. In main exam, we'll see. General MCQ. The order of Pack Private Limited, a pickle manufacturing company, notices the company is expanding its operation into North India states in financial year 24-25, but the related ICS remains the same to handle the increased volume of transactions, and consequently concludes that MM would not be prevented, detected and corrected by the entity's ICS. Which risk is this? The moment you say this, It is wonderful. Next. The Auditor of XYZ Limited performed, see, I don't know, note down and keep, we will see later, okay. The Auditor of XYZ Limited performed procedures to obtain SAI covering each and every area impacting the FS of the company by 20th July. Before signing on 16th September, the auditor became aware of fire accident of the company's yarn factory on 10th August, destroying a large part of inventory. This is very similar to SA 570 or 560 huh? 60 no, subsequent events. Now what they are telling, sir, performed impacting the financial statements by 20th July. Before signing on 16th September, you became aware that on 10th August. So signing date is when? 16th September. Correct? When did this event happen? 10th August. Clear? And they are telling financial statement is 20th July. God knows what are they talking. Let's see the options. Perform procedures designed to obtain SAI that all events occurring between financial statement date and report date that require adjustment or disclosure have been identified. Okay. Is only identification our problem? No, I told you when I showed the chart, identification is not the problem. It should be reflected in the financials as well. Let's see what is the next thing. Same, if such subsequent events requires adjustment or disclosure shall be determined whether such event is appropriately then obtain written representation that all events have been adjustment has been done and disclosure has been made. Which statement is true? 5 statement is important, or 5 procedures we have done. Number 1, 5 statement, 5 procedures we have done in SA 560. Remember, I told you facts, events and facts. With respect to events, you have to obtain SAI. For SAI, we have to put procedures. 5 procedures you have to put. ROMM, clear. Then plan. Then with respect to understanding the management, see whether they have identified, properly reflected and taking legendary. SA 580. So you are telling what? D, okay, let us see. I don't know. Next, 8th one. While conducting audit of Sandhya Limited, having turnover of 200 CR and borrowings from banks at 50 CR, team is determining that accounting policies and methods of recording debt are appropriate and applied consistently, and also verifying loan balances with reference to sanction letter. By doing about, team is trying to satisfy about what? God knows. Read. They are talking about what? Audit of Sandhya Limited, turnover 200 CR, borrowing 50 CR. Okay. Now, team is determining that policies and methods of recording debt are appropriate and applied consistently, and also verifying with reference to sanction letter and loan agreement. By doing what are they talking about? Recording is appropriate and verifying with the sanction letter. Valuation. Completeness. Tell one more also. Why leave disclosure? We drink it. Tell disclosure also. One is saying one option A, other saying B. Right. Which option? Good question. I know which option it is. You tell me. C, okay, one option I got is C. One option I got is A. Correct. Tell others E, F also you tell, no problem. Where are you seeing? I don't know. Okay. Which one? Option A, sir. Okay, A, I got 2 votes. C 2 votes, C 3 votes I got. A 2, option A. Okay. Right. Let's see. So it's not about B and D. Definitely not disclosure. Definitely not disclosure. No, because they are not talking about how it is disclosed. They are just talking about recording is appropriate or verifying loan balance with the sanction letters. Fine, sir. Let us see. So is no one for B existence? No, Now, fine. 8th one. Now 5, 6, 7, 8. 6, 7, 8. 6 is B. 7 is D, 8 is what we have to see. Okay. 6, 7, 8. 6 is B, 7 is D, 8 is C. Now in C what they have told, sir, valuation. You know why we are talking about valuation? Very serious. Why they are talking about valuation? Correct. Clear. Guesswork. Nice. Sometimes that's what I'm telling you. You don't know, guess it. You never know. You might get that 2 marks. Clear. So they are telling that, see, whenever valuation talks about the point here, we are seeing whether recording is appropriate or not. That means we are not seeing whether they have recorded or not. Whatever recording they have done, whether it is appropriately recorded or not, that means we are checking how much you have recorded, and that I am verifying with what? Sanction letter or agreement, which is nothing but valuation only. We are talking about outstanding balance, how much you have recorded. Got it? Clear? Okay. For your purposes, I will write here good question so that you know that you have made mistake in question number 8. Clear? No problem. Now comes little, I think we are getting a hint, sir. Clear? Everything was correct. 8th one was wrong because descriptive is going to come now. Okay. Chapter number 1. Mickey and Associates. Now, wait. I told you how to read a question. What is the requirement? Now, can you give complete assurance or guarantee? For a day. We are giving only simple. Clear? We have solved it. Now go and read the story. Mickey and Associates CA appointed as auditor of STI Textile Manufacturing for financial year 24-25. Management of the company discussed with the newly appointed CA that company has been suffering losses for the last few years, and also the directors are suspecting that accounts are not properly maintained and might contain errors and fraud. So in the given situation, management requested the auditors to give complete assurance or guarantee. I cannot. Discuss with reference to the objectives. What is objectives of audit? Reasonable assurance and reporting. Clear? Okay, sir. Chapter number 2. What is the requirement? Explain the above stage of planning process as considered by the. That means they are asking us to read the case and give a. So this is a, can I say case based, sir? Yes, sir. Mika Associates CA are appointed as chartered of B Limited for the first time in financial year 24-25. Before commencing the audit, the partner considers integrity of the directors, evaluates competence with ethical requirements including independence, and sends engagement letter to avoid misunderstanding. What stage is this? Preliminary engagement activities. There are two things, PE and planning. This is not about planning, this is about engagement activities. That is what they are telling. Good. Third, SPOM and Co. Firm of CA. What do they want? Explain the concept of misstatement at least with the 5 examples. Right? I will mark it as a good question because we generally consider misstatement as a normal concept. Sarvadharana concept, but they have asked on that only. Clear? Good question. SPOM and Co. Firm of CA established in 2010. Major focus on practice. Good for you. Financial year 24-25. They have 4 partners and 15 article assistants handling various audits, statutory assignments as well. Partners and article assistants meet monthly to discuss various aspects of practical as well as academic issues. While discussing about various aspects of audit risk, ROMM, partner S asks one of the article assistants to explain the concept of. Is it case based? Directly you could have told. Tell what is misstatement, help with examples. Clear? I was born in 2010, 15 people I have. Why do you want to tell that? Right? Good question, we will see. Mark it as 11th one, good question, we'll go and see. Okay? 4th one. No problem, sir. They have only given you. With respect to essay 505, name the appropriate term that may be used for below statement. Evidence obtained as direct written response to the auditor from a third party in paper form or by electronic or other medium. Positive confirmation. Positive confirmation. Hello. Yes, sir. Okay, fine. Next. positive. What do I know? I don't know. Request that you are telling positive. I've written. Request that confirming party responds directly only when he to the auditor indicating whether the confirming party agrees or disagrees with the information in the request or providing the requested information. Nice. Tell positive. This is the meaning of external confirmation, loose tools. See here, to the auditor from a third party, direct written response. Okay. Now, next one. Request that confirming party responds directly only if he disagrees. What level of answering? Next. Failure of confirming party to respond or fully respond to a positive confirmation request. Non-response. Next. Response indicates a difference between requested and given. Exception. Now, you told first also positive, no? Wait. Question number 12. The meaning of external confirmation தெரியாது அதுக்குள்ள positive negative tell die. It is external confirmation. So first is positive correct, negative correct, non-response and exception is correct. Clear? Good. Next. Simon Co. Chartered accountants have been appointed as charters of Delight and Delight partnership firm for the first time financial year 24-25. Nada veno. Explain the objective of auditor with respect to opening balance. Nonsense. Essay. Initial audit engagement. Objective is one. What is your objective? Obtain SAI with respect to opening balance. Obtain SAI with respect to accounting policy. Only two objectives you have to write for that. Clear? What is the answer, sir? Every time I have to shift. Wait. Good. Which question? God knows, sir. See? Obtain SAI about whether opening balance contains misstatement that affects CPFS. Accounting policy referred in opening balance consistently applied, and if there is any changes properly accounted, presented APD. Remember APD? Same logic. Right, sir. Good question. Easy question. Not your level, but your level is here. Next. Chapter number 5. Requirement you read. Name the relevant assertion for verification of ownership and procedure to verify the same. What assertion they are saying? In balance sheet of Watches Limited, additions worth 20 crores are appearing under PPE. The auditor of a company, in addition to procedures undertaken for verifying completeness of additions to PPE during the period while performing the testing, he also wants to verify that all PPE purchase invoices are in the name of the company. What is it targeting? Name the relevant assertion for verification of ownership and procedure to verify the same. So they are asking two things. Name the assertion also, tell the procedure also. What is the assertion name here? Rights and obligation. Because I told you, whenever asset means I have a right, it belongs to me. But if it is a liability, it is an obligation. So they are talking about additions to PPE ka procedure. Clear? 5 points here. At least RTP questions you do and go for these chapters. Clear? Check the invoices are in the name of the entity for legal title of ownership. Then for addition, check the conveyance deed or sale deed in case of land and building. Verify the original title deeds in case of immovable property as security for any borrowings. Request the management for obtaining a confirmation from lenders. Verify register of charges available. Clear? Okay. Next, audit documentation. What do you want? Requirement. Nothing I can do. I have to go and read because they have said with the requirements. FSY and Co. CA completed the start audit on for 31st March. The partner instructed the team to finalize and assemble the audit documentation immediately after signing the report. Nonsense question for you. Assembly, how many days? From where? 15th September. However, audit team took this instruction lightly, like you guys, and forgot to assemble it. After 6 months, they started assembling the file. After 6 months you should assemble. 60 days from 15th plus 60 days. How much? Within how many days? September we have 30 days. 30 minus 15 is 15. Then October 31. November 15 plus 31 is 46. 46 plus 14 is 60. So on or before 14th November you should finish documentation. Okay, then and completed the documentation. Partner became aware of this. Very good. He called a meeting of staff and article did it. Article no audit team. And for timely completion of files, changes to the documentation and period of retention. Period of retention how much? Tala for a reason. 7 years from where? 15th September only. Clear? Explain various points discussed by the partner. Now we know same 60 days completion of assembly file. Then you can write this administrative changes and then no shorter than 7 years. Remember the documentation I have given you on list now. That only you write. Completion and review. GEM Limited appointed GSP and Co. Chartered Accountants as its statutory auditors. While conducting its audit, the partner requested the management to provide that it has fulfilled its for preparation of FS. Which WR is this? I give you 3 WR. Primary, secondary and specific assertion. Which is this? Which is this? Primary. Why? This comes under primary WR. The manager of finance is of the view that since all records and evidence have already been given, separate WR not required. Is it so? No, you have to give a primary WR. Okay. Where is it given? The manager, the entire thing they have given. View is not correct because WR about management responsibility are necessary due to the now this is a story they have given. You have to explain why it is important based on your conceptual understanding. Clear? Yes, see, full explanation they have given. You need not write so much. Clear? Give 1, 2, 3 liners as to why it is important and do this. Clear? These points at least you write in the paper. Sometimes RTP will give you copy paste of study material. Not sometimes, 90% of the times. Clear? 17th one, essay 701, which is it? What they are asking, purpose of? What is the purpose of? Enhancing communicative value. Relationship will be better. Remember, communicative relationship. Same point they have given. What is the purpose? Para they have given, nonsense. Enhance the communicative value, greater transparency, provide additional information to intended users, and then matters which are those significant, then assist the intended user understanding the entity and areas of significant, basically 3 purpose. Clear? Pointers you write, don't write in paragraph. If you, no, you write in paragraph. If you are writing in paragraph, no, don't tell you are my student. Okay? Because you have to only write in pointers. Reason being is we saw this and we started searching where is the point. Clear? Same logic as a valuer, I will not sit and search for 100 papers. So write in pointers, underline and keep. Clear? 9th one, what do you want? Inventories in the nature of food and beverages. Basically for what? Hotel they are asking. Okay. What they have to say? Inventories must be kept locked and retained by the departmental manager. Released only on to the trusted personnel. Specialized valuers to count the inventories. Ensure all inventories are valid at the year end and you have to be present at the year end physical verification to the extent practicable. Somewhere essay 501 talks about it. Clear? Okay, sir. Next, bank audit. What they want? Now we know nothing they've asked. Discuss. Okay. While verifying provision of advances of a branch of HFC Bank as a part of statutory branch audit, CA Mini notices that credit facilities consisting of term loan of JT Mills have been classified under D2 category. For D2, what is the provision? 40 plus 100. 40 for what? 100 for what? Yeah. Remember today's outstanding balance in the above term loan account is 150 lakhs. Security is 100 lakhs. Provision is 70. Same question is solved. 150 is total outstanding. How much is secured? 100. How much is unsecured? 100%. How much? 100. 40% how much? 20. Correct now. Total 120. How much he has made? 120 minus 75. How much? 45 extra provision he has to do. Let's see how much they have done. Correct. Unsecured portion 50. Required provision 90. How sir? 40% of secured part how much? Na paakringa. Jumped into conclusion, no. Jumped into conclusion, no. So listen to me very carefully. This can happen in the exam. Why? The moment you got to know that a question which we have seen or which we have solved. Yes sir, we have solved the same question. Your mind will run to the class question or any question that were repeated. And silly error. Very silly error you will be doing it. What did they do? Technically, if you see, look at the presentation how they have solved. Therefore, provision of outstanding balance is how much? 150. Value of security how much? 100 lakhs. Correct. Unsecured portion is how much? 50 lakhs. Correct or not? Now, 100% of what we have to take? 50 we have to take. So, 100% of 50 is how much? 50. 40% of what we have to take? Secured we have to take. What is secured? 40. 40 into 100 will be so much, and 90. How much they have made? 75. How much extra we should make? 15 we should make. And how much we told there? 45. Nobody even bothered about what mistake I did there. What did the mistake? What was the mistake? I just interchanged the calculation. Correct? I already told you 100 is secured, 50 is unsecured, but I changed the percentage and put. What is the percentage I did? 100 into 100 I did. Nobody even bothered to notice that. And you played along saying, 45, correct sir. That too you calculated this. Moral of the story, these mishap will happen. Clear? When these mishap happens, no. In the exam, when you get the scanned copies and when you see, you will regret it like anything. Because according to your head, you have done it correctly. Clear? Question is very easy. Right? So technically it is not 100 into 100%. It was 100 into 40, 50 into 100. Therefore it is 50 plus 40, 90. 120 minus, sorry, not 120. 90 minus, how much they have done? 75. Therefore 15. Now how much excess provision they have to do? Provision made by a branch is not proper. It should have made of 90 instead of 75 lakhs. Clear or not? If you want, you can write extra 15 lakhs provision can be made for D2 category. Purida? Yes. Clear or not? These are silly mistakes that you are supposed to not make in the exam. Okay? Right, sir. Number 20th one. Bank audit ethics. What do you want? Identify and explain fundamental principles of professional ethics. Fundamental what they have asked? What they have asked? That means what? IPCCO. Integrity, professional behavior, competence and due care, confidentiality and objectivity. Independence is not the question here because they only asked what? Principles. Let us see. CA Jatin is auditor of XYZ Pharma. His brother-in-law's partnership firm. Okay. Brother-in-law's partnership firm is an auditor. Something is wrong here. What is that? Are we talking about threats to independence? That's exactly what I told you. You will directly go to independence now. They are asking only with respect to principles. Objectivity is the point here. Because you will not be able to give unbiased opinion. Okay, let's see. His family relationship creates a conflict that could unduly influence his professional judgment, making it difficult for him to provide unbiased. What is this? Okay. In another assignment of tax audit of a company, CA Jatin is also required to prepare company's tax return. He fails to check the latest provision of Income Tax Act which allows for a major new reduction for the client overpaying income tax. Professional? There is no ethical principle only for professional judgment. Competence and due care. Are you sure? Not professional behavior? Why? I told you, B for behavior, B for business. Clear? Right. No, not. Now you might lose marks because you said you are right half. You said professional judgment. There is no ethical principles called professional judgment. Having professional judgment is not ethics. Clear? That's a requirement of a auditor when you work. Okay. CA Jatin is also preparing GST returns of one of his clients. The clients instructs him to intentionally understate the sales figures to reduce a tax liability. Huh? Integrity, huh? I don't know. Sure, no? Pakka, no? May. Hey, your exam, you might write this in May.
Confidentiality as well.
It could be?
Confidentiality.
No, instructs him to intentionally understate the sales, meaning he is asking to leave out certain amount so that tax evasion can happen.
Can be confidential also.
No. Confidential is whatever information you have of the client, you should not show it out. That means you will not file returns only. Okay, let's see. You said integrity. Let's see. First one is what? Super objectivity. Second one is what? Diligence is there. Diligence. I told you. Diligence word nale what? Professional. Competence and due care. Super. Third one. Tan, 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 tan. Where is it given, sir? Oh, integrity principle. Clear? It's not confidentiality. Confidentiality means what? Where the information which I already have of the client, when a third party comes and asks, I should not tell unless there is a professional duty for me to tell. There is, client has given me the permission to tell. Number 2, law. Number 3, professional duty. Now, when income tax comes and asks me, tell me about a client's information, now why? Confidentiality. Hey, duty, professional duty, you have to tell. Third party comes and asks, then I should not tell. Clear? Department is coming and asking and you're telling professional duty, I'll not tell. Clear? That is very wrong. Understood? Clear? Now tell me, we solved RTP, no? Maybe 2-3 questions were confusing for you. Apart from that, most of it is solvable. Why? I told you, technique is very important to read a question. You read the story, if you had solved this entire RTP with reading the story and then come to the requirement, no, you would be spending more time now and you would be confused what they are trying to ask. So how you should read? First, read the requirement. If the requirement says explain, discuss and all, then go to the question. Otherwise, directly stop at the requirement. You will have an idea what chapter this question is from and then move on to the next question in those 15 minutes. That 15 minutes, don't sit and see, okay, what is the option for this? You got to know, this is fundamental principles, go to the next one. Don't bother about it. You got to know, this is essay 5 and 0, objective they're asking, go to the next one. Don't sit and revise, what is the objective, what is the objective? That is waste. Clear? Because you have 15 minutes, you have to rank the questions. Understood or not? Clear or not? Yes, sir. With this RTP Jan 26 also done. As far as I am concerned, under average difficulty level, I'm telling, not even moderate for you. 1 or 2 questions a little confusing. MCQ 8th one you got little confused. Apart from that, I don't see any problem in this. Go give a reading again, right? I am not saying same answers you should copy paste in the exam. Remember, presentation is very important. Clear? Having said that, marathon also completed, RTP also completed. All the very best. Study really well for Jan exam and hope for exemption in audit. Clear? Yes, cool. Thank you so much and have a wonderful rest of the evening, guys.
Thank you, sir.